Happy morning, happy afternoon, and happy evening to all my Nanbas and Nanbis. Audit Marathon for Jan 2026 and May 2026 examinations. I'm going to give you a small introduction where you definitely have to watch before you watch the entire 20 hours of the marathon. Auditors don't assume, they examine. And winners, they don't lose hope, they prepare. Welcome to your audit marathon where every minute that you invest here will show up as a value addition in your results. Now I'm going to quickly show you as to what are all the standards and other chapters which are getting covered as part of this marathon. You can see that all the standards are covered. Please take a quick screenshot so that this is going to tell you what you can expect in the next 20 odd hours. And if you see, all the other chapters are also covered here: ethics, cooperative society, government, bank, and also items of FS. Just take a quick screenshot, guys. Basically, if you see my regular lectures, they are for 100 hours. I have just recorded them, latest lectures for the 2026 examinations. And these lectures will be based on my latest concept book. I understand not everybody will have the time to finish the entire 100 hours of lectures, and that is the reason why I have curated this marathon in approximately 20 hours. If you ask me, this is one of my best marathons, guys, where I have done till date. Hands on, I can tell you this is one of my best marathons, and I am actually proud to do these 20 hours, to curate this 20 hours for you guys. You can experience it yourself and let me know in the comments how it has helped you, because this is also going to be seen by other students and they will see the comments and they will start watching the marathons. It is for that reason only, guys. This marathon is basically a quick revision of all the concepts, entire syllabus in one place. Especially in the last 2 months of your examination, this is gonna be a game changer for you, because it will help you for your revision and it will also give you a hands-on conceptual clarity of the entire auditing subject, guys. How to use the marathon, I will tell you. There are two ways to use the marathon. You can watch standard by standard, watch the marathon fully, entirely you can watch it. Or if you have missed out any standard or any chapter, you can use this marathon for any standard or chapter which you've not covered before. At least watch this marathon and then go for your examination. Like I said, the regular class and the marathon is covering 100% as per ICAI. All the concepts are covered. There is no selective study, which I will encourage, and that is the reason 100% as per ICAI is covered here. Now you all will want to see the book. How is the book? This is how the book will look. It is a fully color book. You can see that keywords are usually the most important part for auditing subjects. So the keywords are given in red in the entire book. And actually the magic happens here in the mind mapping when you do for every standard, for every chapter. We will start off with a mind mapping. I want you to experience this magic as to how you're getting the conceptual clarity when you start with mind mapping and then the standard flows in the same order of the mind mapping. Trust me, this is going to be a game changer for you. Where can you download this book? You can just go to the CA Classroom website. In the free resources, auditing and ethics, you just have to enter that. New audit concept book for regular lectures. You can directly go and download the book, guys. This is how the cover will look, and yes, that is the book for you guys. I've spoken about the book, I've spoken about the marathon, I've spoken about the 100% lectures also. All the very best. Let's straight away get into the marathon, guys. And once you finish, I want you to share your experiences in the comments. And all the very best, guys. Enjoy the subject and study the subject. I'm gonna start off with essay 200, but before I get into any standard, I'm gonna give you an overall purview as to what is an audit. Only if you know this are you going to understand the standards and what is given in the standard and all of those things. Is that clear, guys? So first, you all tell me, in your opinion, what is the meaning of audit? I don't want the definition of audit or anything. Just tell me what is the meaning of audit. Now, if you can't think of anything, I want to ask you all a question. Have you done audit in your life before? Have you done audit in your life before? Yes, no, maybe. Most of you all are saying no. Now you please tell me, when you go to a restaurant, you go, you order food, you eat, and they give you a bill. What do you do to that bill? Do you just pay off, or do you do some activity there? You check the items to see whether they have billed you for something extra, or if they have missed out an item, you check that. So that is also audit. Now you please tell me, have you done audit in your life before? Yes. Everybody sitting here and everybody watching the video have done audit in their lives before. Maybe you did not know the name, that this only is audit. My favorite boyfriend girlfriend example I will take. Say for example, when the boy leaves the phone and goes, you know the password of the phone. Very, very dangerous situation. What do? You take the phone and you inspect the phone. That is also audit. Inspecting is also auditing. Now, after he comes back, if you see something fishy, he has messaged some girl. After he comes back, what are you going to ask him? Hey, who is this girl that you are messaging to? You are inquiring that person. That also is audit. You're checking, verification, inquiring, inspecting, whatever you do in your life, everybody would have done audit, guys. This is not new to you. I don't want you to think that this is something new. This is something new that I'm learning. No, this is something you're doing in your everyday life. Maybe financial audit is what is new for you. Now, let me give you a small example to connect this to finance. Say, for example, Daimler AG is a company. You all know Daimler AG? Daimler AG is the parent company for Mercedes-Benz. You know Mercedes-Benz, right? So Daimler AG is a company which is purchasing huge plant and machinery for 5 crore rupees. Purchasing huge plant and machinery for 5 crore rupees. Now, can you tell me the journal entry that you will be passing in the books of Daimler AG? Plant and machinery account debit, because debit what comes in and what is going out? Cash is going out. So bank account debit, credit was goes out. You are going to pass in this journal entry. Now, this is called as journal entry. No doubts in this, correct? Now, what happens to this journal entry? This journal entry gets translated into a ledger. This ledger goes to a trial balance. This trial balance goes to P&L. This P&L goes to balance sheet. And what happens? This P&L and balance sheet together, they are given to the auditor. So who prepares this P&L and balance sheet? Who does the journal entry? Who does the ledger posting? Who does the trial balance? Auditor will not be doing all of those things. All of these activities should be ideally done by the management only, and the P&L and balance sheet will be given to the auditor. P&L and balance sheet collectively is called as FS, that is the financial statements. Is that clear? Now, what is the auditor going to do? The auditor will basically give his verdict as to whether the financial statements are as per the books of accounts, whether the financial statements are as per AFRF, that means whether they are prepared as per all the accounting standards. There are so many rules which is given in the accounting standards as to how the journal entry should be passed, how the financial statements should be prepared. So whether the financial statement is following all the accounting standards, is who will see? The auditor is going to see whether it is as per the books of accounts AFRF, and based on that, the auditor will be giving something called as a verdict. In our terminology, we are going to call this as opinion. This opinion is of two types, where they will say it is correct or it is incorrect. This is English, that is correct or incorrect is English. In auditing terminology, if it is a correct, verdict. That means the financial statements are as per all the accounting standards, that is the AFRF. You are going to give a unmodified opinion. In the case where the verdict is saying that it is incorrect, that is financial statement somewhere it is not as per the accounting standard, then in that case you are going to modify your opinion. The verdict is called as opinion. The opinion is basically saying whether it is correct or incorrect. If it is a correct opinion, it is called as unmodified opinion. If it is an incorrect opinion, it is called as modified opinion. Clear till here? Yes. Now the auditor is giving the verdict for whom? That is the question that you will be asking. For whom is the auditor giving the verdict? The financial statements are basically prepared and presented by whom? By the management. So is the verdict also given to the management? No. The verdict is given to the stakeholders. Now you have to ask me the question, who are the stakeholders for a company? You all already know this. Who are the stakeholders? The shareholders. Yes, definitely they are the stakeholders. Apart from that, the bankers, yes, they are the stakeholders. Anyone else? Creditors, yes, of course, creditors are also the stakeholders. Banks is already told. Government is the stakeholder. Any prospective investor, so anybody who is going to rely on the financial statements for some decision, then they become the stakeholders of the company. For these stakeholders only, the opinion is given by the auditor. That is, the verdict is told. The opinion is of two types, that is, it can be correct or incorrect. Correct means the financial statements are as per the applicable financial reporting framework, which is nothing but your accounting standards. Incorrect means, in auditing terminology, we will call that as modified opinion. That means the financial statements are not as per accounting standards. Clear? This is the base for you. Very, very clear, guys. Any doubts still here? Now I'm proceeding forward. See here, so many people are actually relying on that verdict, relying on the opinion. The opinion is given in the audit report. So the stakeholders are relying on the audit report, which is given by the auditor. That means the auditor has to be doubly careful when he's giving his opinion. He can't play the fool here. Yes or no? He has to be extremely careful when he's giving his opinion, because so many people will be putting in the money, waiting for the money. So many people are actually relying on the information which is given by the auditor in the audit report. So the auditor has to be doubly careful, extremely careful, and he also has to be independent. Now, what is the meaning of independent? Independent means he should not be related to the company in any way. He should not be a related party for the company. That means the wife, brother, sister, father, mother, all of them are independent. They cannot be appointed as the auditor of the company. The auditor has to be independent only. Is that clear? This is the base as to what you have to know before we enter into the subject. Now I'm gonna tell you how we will be studying every chapter and every standard. This is the way I am going to teach. I will first give you a broad overall perspective as to what you can expect from each of the chapters and standards, and then we will be diving inside as to the theory part. So here, nature, objective and scope of audit. This is the chapter number 1, and under that what you are going to study is what is audit, what is the responsibility of management, interdisciplinary nature of audit, and then we enter into essay 200. Under essay 200, there are few things that you're going to study. Until here, we will finish and then we will come back to the mind mapping. For now, you're only going to learn basics still. What is audit? What is the responsibility of management? Is there any interdisciplinary nature of audit? Clear? Now coming to what is audit, it is a definition. Definition means verbatim you have to reproduce in your examination. An audit is an independent examination of financial information. Now wait here. Audit is an independent examination. You know the meaning of independent. What I want you to note here is it is an independent examination of financial information. The terminology that they have used is financial information and not financial statements. What is the meaning of financial statements? Your profit and loss in your balance sheet is called the financial statements. So what is the meaning of financial information? The financial statements along with your trial balance, ledger, journal entry and the invoice based on which you did the journal entry. All of that put together is called as financial information. So audit is an independent examination of what? Of everything, of the financial information and not just the financial statements. That is the first point I want you to note here. Audit is an independent examination of financial information of any entity. What is the meaning of this any entity? Whether it is a sole proprietorship, whether it is a partnership, whether it is a company, whether it is a LLP, let it be any entity, an audit can happen to that entity. That is whether profit oriented or not, irrespective of the size or legal form. Whether it is a small company or large company, audit can happen. Whatever legal form that it has, audit can happen. Now you all tell me, for a company which is having a revenue of 4,000 crores, can you do audit for this company? Yes, you all can do audit of this company. If the revenue is 40 rupees, can you do audit of this company? Think and tell me. Yes, of course, you can do the audit of this company also. If the profit of the company is minus 1,000, can you do the audit of this company? Minus 1,000 rupees. Can you do the audit? Yes, of course, you can do the audit of this company also. So, audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size, whether it is a small company or a large company, or legal form also you take, sole proprietor, partner, whatever it is, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon. So when the auditor goes for audit, auditor should have this in the head that I am doing all of these things for basically giving something called as an opinion. That is my main motive. So if that is there, you can call that as an audit. Now, what is the definition? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. Clear? How are you going to remember this? I'm going to split the entire definition. Audit is an independent examination of financial information of any entity. Why these lines are coming and disturbing? Independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. What should be the purpose? When such an examination is conducted with a view to expressing an opinion thereon. Are you able to understand? Now, if you write like this somewhere and keep it aside, when you keep on looking at that definition, automatically it is going to go inside. In audit, the main thing is the keyword that you have to remember. For all of you are saying, ma'am, I cannot remember keywords, ma'am. It is very difficult for me. I am able to study the subject. I am able to understand the subject, but remembering is the problem. For all of you who are telling that, can you please tell me what is after hukum dash ka hukum? Can you fill this? Everyone knows it is tiger ka hukum. Yes or no? You will not say cheetah, you're not getting confused, it is lion, you're not getting confused, it is a leopard or a rat or whatever. You know exactly it is tiger ka hukum. Is there any thinking which happened here? Is there any thinking when you actually thought whether it is a tiger or a lion or a rat or a mouse? What is it? There was no thinking. Automatically you are able to tell me because you heard that song multiple times with full interest. Same way, if you listen to the class with full interest, if possible multiple times, then automatically you're going to tell with me as if I'm singing a song. If I start essay 200, you will finish it. Are you able to understand? So don't tell me this. So the story is saying I can't remember. I will not remember the keywords. Don't tell me all those things, guys. I will not believe you. You can remember thousands of songs. Yes. Even if I tell Makka Mishi, you will be like left hand la handle pandra Michael Essi. How you are able to say that? Because you heard that song. Same way with that interest, if you are able to listen to the marathon or listen to the videos, then definitely you will be able to remember the keywords. No doubt about it. Is that clear, guys? So what is an audit? An audit is a independent examination of financial information of any entity, whether it is profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. Clear? Now I am moving forward. In doing so, he has to ensure that the financial statements will not mislead anybody by ensuring that the accounts have been drawn up with reference to the entries in the books of accounts. The entries in books of accounts are adequately supported by sufficient and appropriate audit evidence. I will come to what is sufficient, what is appropriate, and what is audit evidence. For now, you just listen to me. None of the entries have been omitted. The information conveyed is clear and it is unambiguous. The financial statements are properly classified, described and disclosed, and the statement of accounts present a true and fair view of the operational results and the assets and liabilities. What is the meaning of operational results? It is the P&L. The assets and liabilities is the balance sheet. What are they telling here? While doing the audit, the auditor has to ensure that the financial statements is not going to mislead anybody. How is he going to ensure? Whatever accounts that you're drawing, which is having the reference to the entries in the books of accounts. Your books of accounts is having the entries. And whatever entry is having the books of accounts is having the evidence, that is the bill, that is the invoice has to be there. None of the entries must be omitted, and whatever entry is there, it has to be clear, it has to be unambiguous. Unambiguous is only a synonym of clear. Same meaning. The financial statements amount should be properly classified, described and disclosed as per the accounting standards. The accounting standards will tell you how you have to classify a specific item, how you have to describe. If it's a contingent liability, there is no contingent liability, you are describing it, and how you are making the disclosures. Everything, it has to be as per the accounting standards only. What is the responsibility of the management of entity? The responsibility of the management is only to preparation and presentation of the financial statements. The auditor will not be involved in the preparation and presentation of financial statements. If you remember the flow, I told you here itself, the P&L and balance sheet will be done by whom? By the management, and then only it will be given to the auditor, and then auditor will give the verdict. So till here, everything is done by the management only. So preparation and presentation of the financial statement is the responsibility of the management. What will the auditor do? The auditor is going to give his verdict, that is expressing the opinion on the financial statement. Where is he going to do that? In a written audit report, he is going to give that. Clear? Interdisciplinary nature of auditing. Auditing has a relationship with a lot of subjects. Auditing is relating to accounts, law, economics, max, data processing, your FM, your costing, everything is related to auditing. How is it related to auditing? Basically, what will happen, I'll tell you. When you go for articleship, people who have done their articleship will definitely relate with me. A person who's representing an auditor or a person who is a chartered accountant is expected to know everything in the world. When I went for my first articleship also, there was one sir who asked me, ma'am, what do you think about Trump? I was like, I don't think anything about him. Why will I think about him? But I can't say that outside. I have to say something. His policies are too haphazard. He doesn't have a proper clarity in his plan. He has to first discuss and then only he should announce. He's doing the ulta. Like that, something. Something is expected out of the auditor. You're supposed to know general knowledge. You're supposed to know politics. You're supposed to know economics. So everything you are supposed to know. That only is the relationship with diverse subjects. Accounting. Auditing reviews the financial statement, which is nothing but a result of overall accounting process. Accounting is done by the management, but for you to see whether it is correct or not, you have to know accounting. So for that reason, you need to know accounting. Law, you're operating for a business, you're doing audit for a business, so you need to know the business laws which is applicable for the company. Economics, yes, the client is operating in an economic environment, you need to know about that economic environment also. What is behavioral science? Now you're asking a question to the management. The management is lying blatantly to you. Now you're seeing that his hands are shaking, his legs are not able to touch the floor. So you're analyzing his behavior, and then you know, okay, I need to ask more questions. I should not trust whatever he's saying. You are basically seeing the human behavior. That is the behavioral science. What is the statistics and mathematics? Why you need all of these things? Say, for example, for a 4,000 crore company, they will have multiple invoices. Is it possible for you to go and see those hundreds of invoices one by one? No. You will be doing something called as sampling at that time. So you need to know statistics and mathematics. Auditor is expected to have a knowledge of statistical sample for meaningful conclusions and mathematics for the verification of inventory. Data processing, nowadays EDP is becoming very popular. Yes, electronic data processing, everything the computer itself is doing. So when everything the computer itself is doing, you need to trust that computer. We all have trust issues, so there is a separate audit called as electronic data processing auditing. So EDP audit, that also you need to know. Financial management, what are your topics in your financial management? Cash flow, fund flow, ratio analysis, capital budgeting, all that only are keywords. Production, this is your costing, such as production, cost system, marketing, etc. All your business functions is there in the production. So this is the interdisciplinary nature of auditing, that is relationship with diverse subjects. Now, what are your subjects which is there in your foundation, you tell me? Accounts, law, economics and maths. 4 points are covered. Yes. What are the subjects in your group 2? Now audit is in group 2. What is there in group 2? Costing, audit is yes audit, and FM, SM. In SM, you will be talking a lot about data processing and all of those things. There is a separate chapter called as automated environment. There you will be studying about EDP. Apart from this, you also need to know about the human behavior. Like this, if you study foundation subjects, group 2 subjects plus human behavior, like this, if you're going to study, audit itself is going to become easy. This is the way to study a vast subject, guys. You first understand what is given to you. After you gain that understanding, now think about how you can remember. Now when I told you foundation subjects, 4 points, done. Group 2 subjects, another 3 points, done. Plus 1. Yes, that's it. Totally 8 points. Group 2 subjects, 4 points, correct? 4 points for foundation, 4 points for group 2 and plus 1. That's it. And you will be done. Like this, if you study, you will not miss out on any point, guys. I'm going to the standard. I told you I will come back to the mind mapping when we come to the standard. We are done with what is audit, the definition of audit. We saw what is the responsibility of the management, preparation and presentation of financial statements. Then we went to interdisciplinary nature of audit and we saw that also. Now we are entering into SA 200. Is that clear? Till here the basics are very, very clear. Now we are entering into the standards. Under SA 200, you are going to start off with the objective of the standard. Then you will be analyzing the objectives. Then you go to scope of SA 200, what and all it includes, what and all it excludes. Yes, guys, I have given that elaborate scope for includes and excludes, but never in the past they have asked this question. But still, I don't want you to miss out on anything. We will be preparing entirely. So I have added the includes and excludes. Benefits, limitations, requirement of audit, for whom it is voluntary, for whom it is mandatory, and who is going to appoint the auditor and to whom is the auditor going to report. All these are given in SA 200. I am starting off with name and number of the standard. SA 200 is talking about overall objectives of the independent auditor and the conduct of an audit in accordance with standards on auditing. Overall objectives of the auditor and how I have to conduct the audit should be as per the standards on auditing, should be as per the essays. Now, what is the objective of the audit? There are two objectives for the auditor. The first objective is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material aspects in accordance with AFRF. If I just read like this, you will not understand. First, you need to know what is the meaning of this word reasonable assurance, because the first objective is starting off with the auditor has to obtain reasonable assurance. What is the meaning of reasonable assurance? Whether this is the same as absolute assurance. Absolute assurance means I am giving 100% assurance that my opinion is correct, that my verdict is correct, or I am giving 100% assurance that it is wrong. Reasonable assurance means with whatever information is provided to me, with whatever knowledge I have about the company, I am giving my conclusion about that company. Reasonable assurance is something less than 100% of assurance. It could be 99%, it could be 99.5, it could be 99.99, it could be 99. All of this is reasonable assurance. So the first objective is to obtain the reasonable assurance with regard to what? With regard to the financial statements. Now here they're using the terminology financial statements because the assurance the auditor is giving is only on the financial statements. The financial statements is prepared and presented by whom? By the management, and it is given to whom? To the auditor. When the financial statements are given to the auditor will be giving the verdict on that financial statements only. What verdict is he going to give? Whether the financial statements as a whole are free from material misstatement. Material means important. Misstatement means mistake. For now, you can just remember it like that. Is that clear? Material means important. Misstatement means mistake. So if there are any important mistakes are there in the financial statements, auditor is going to see that the financial statements are free from any important mistakes. That means they are not going to be there. How these important mistakes can happen? It can happen whether due to fraud or error. Now you have to know what is the meaning of fraud and what is the meaning of error. The difference between these two is only the intention. It is only the intention. Say for example, I made a mistake by saying that these points are not there. Like that I made a mistake. Now I seriously want you to not get through the exam. So purposely I have missed all the points. That is a fraud. And the first one, what I told is an error. So basically the intention is what matters. Now intention, if it is there to fraud somebody else, then you will call the fraud. If intention is not there, you will call that as a error. Are you able to understand? I will give you another example for you to understand. Say for example, Roshan is there. Roshan is going with his girlfriend in bike. To where is he going? To Bessie Beach. Other state people, Bessie Beach is basically a couple's beach in Chennai. Yes, so Roshan and his girlfriend are going in their bike to the Bessie Beach. Now there a group of boys are teasing the girlfriend like anything. Roshan is getting very angry. And what he did, first he has to protect the girlfriend. He took the girlfriend in the bike, took her home, safely dropped her home, came back to Bessie Beach. Like that he came back to Bessie Beach. He made all the calls to his friends. And that group of boys who are there, he went and he slapped them tightly. He fought with them nicely. In that, one guy mar gaya. One guy, what happened? He went off on top. Mar gaya. This is the first situation. Now, second situation, the same Roshan is going in his bike and he is talking on call to his girlfriend, the same girlfriend, very same girlfriend. He is talking on call when he is going on the bike. He is coming to class. That time girlfriend is asking, hey, what early morning you're going to class, like that. She's simply asking. Now when he's talking like that and coming in the bike, one tata, pavam, he was walking on the corner of the road. How corner it is? Road is here. He is walking in the corner of the road. What Roshan did while talking to his girlfriend, like that, boys will usually just tell, correct? Not much of talking. Like that, when he's talking like that and going, suddenly he went like that and he hit that tata. What happened to that tata? Tata mar gaya. In that second situation, Roshan went and hit that tata, not in that intention to hit him. That is called as what? Error. In the first situation, Roshan went dropped his girlfriend, called his friends, came and bashed all these boys. That means he planned and did it intentionally. He did it. When intention is there, you will be calling that as fraud. If intention is not there, you will be calling that as a error. Are you able to understand? Now you understood material misstatement, whether due to fraud or error. You will never ever forget what is the meaning of fraud, what is the meaning of error. Thereby, which is enabling the auditor to express an opinion whether the financial statements are in accordance with AFRF. AFRF is nothing but accounting standards. So the auditor is basically obtaining assurance whether the financial statements that is given to him is not having any mistakes. That mistake could be fraud or error, whatever, should not have any mistakes ideally. Thereby, it is enabling the auditor to give a verdict, that is the opinion. What opinion is they giving? That the financial statements is prepared as per accounting standard. That financial statements are prepared in all material aspects in accordance with the applicable financial reporting framework. Are you able to understand? If I have to break this down and give it to you in a way that you can remember, please note down, guys, you cannot change any words here. First, to obtain what assurance? Reasonable assurance about whether the financial statements as a whole are free from material misstatement. These misstatement can be either due to fraud or error, thereby enabling the auditor to express an opinion whether the financial statements are as per AFRF. Clear? Now, if you write like this, there will not be any mistake in the first statement that you're going to make. This is the first objective. The second objective is to report on the financial statements and communicate as required by the essays in accordance with auditor's finding. How should the report be? How should the communication be? It should be as per the standards on auditing. The financial statements should be as per the accounting standards, and the report of the auditor must be as per the standards on auditing. The report has to be prepared as per essay. Communication has to be as per the essays only. Is that clear? The objective, two objectives, very, very clear. Now we are going to analyze the objectives. Obtain reasonable assurance about whether, now I've already given you overall picture. I've already tagged each every word of the objective and I have given it to you. Now this analysis is going to be easy. Obtain reasonable assurance about whether financial statements as a whole are free from material misstatement, whether due to fraud or error. Reasonable assurance is to be distinguished from absolute assurance. Absolute assurance is like a guarantee or a complete assurance or 100% assurance that financial statements are free from material misstatement. Here it is not a complete guarantee. However, 99.99% means you are still giving a high level of assurance. However, it is not a complete assurance. Misstatements in financial statements occur due to fraud or error or both. The auditor seeks to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether caused due to fraud or error. He must see the effect of the misstatement on financial statements as a whole in totality. Obtaining reasonable assurance that financial statements as a whole are free from material misstatement is enabling the auditor to express an opinion whether the financial statements are prepared as per AFRF. The opinion is reported and communicated in accordance with audit findings through a written report as required by standards on auditing. Whatever we saw here, they have made it enlarged and they have given it as 4 points. Now, what is the meaning of historical financial information? History means what? Something which happened in the past. So, historical financial information means information which is expressed in financial terms of an entity that is from the entity's accounting system only, but occurring in the past period or about economic conditions or circumstances at points in time in the past. So anything which happened in the past, and if it is a financial information, we will be calling that as a historical financial information. For example, when purchases and sales are reflected in the financial statements of an entity, these are examples of historical financial information. Now, all the financial statements that you are going to see, that is your P&L and your balance sheet, are they talking about the future? They are all talking about the past, and the auditor is going to do a post-mortem activity of what has happened in the past. Yes or no? It has all happened in the past only. So can I say that the P&L and the balance sheet is the historical financial information? Yes, of course. These are the historical financial information. What is AFRF? A framework adopted in the preparation and presentation of the financial statement that is acceptable in view of the nature of the entity and the objective of the financial statements, or that is required by law or required by regulation. In case of companies in India, financial reporting framework is provided under Schedule 3 of the Companies Act. Basically, what is the auditor going to see? Whether the books of accounts is as per the AFRF is what he is going to see. Scope of audit. Scope of audit includes coverage of all aspects, reliability and sufficiency of financial information, proper disclosure of financial information, expression of an opinion on the financial information. Scope does not include preparation and presentation is the work of whom? The management. So obviously, audit scope does not include preparation and presentation of financial statements. Duties outside the scope of competence. Say, for example, they are asking you to certify this machine is 10 years old. It can be used for another 10 years. Can you please sign and give it to me? We don't know about the machines. So that is outside my scope of competence. I will not be able to comment on the life of the civil structure or the condition of the asset and all those things. Expertise in the authentication of document. Now, if they're going to give me an invoice and ask me to sign on that invoice so that they can prove that the invoice is genuine or not, how can I sign on the invoice and all? So expertise in the authentication of the document is not the work of the auditor. And investigation, it is not part of audit, because investigation is 100% assurance. Audit is only reasonable assurance. The scope refers to range or reach of something. The purpose of audit is to enhance the degree of confidence to the intended users. Who are the intended users? They are the stakeholders, the shareholders, employees, customers, government, regulatory authorities, bankers, all of these people. The following points are included in the scope of audit of financial statements. Coverage of all aspects of the entity. Reliability and sufficiency of financial information. The auditor makes a judgment of reliability and sufficiency by making a study and assessment of accounting systems and the internal control. Proper disclosure. The auditor should also decide whether relevant information is properly disclosed. He will be keeping in mind all the statutory requirements. It is done by ensuring whether financial statements properly summarize the transactions. The management only is responsible for preparation and presentation of financial statements. Historical financial information in relation to a particular entity. Already this has finished, correct? Pertaining to the past time period or about economic conditions or circumstances at particular point in time in the past. What is not included in the scope of audit? Anything which is outside the domain of his competence. Auditor is not an expert in authentication of document. Auditor is not an official investigator. Audit is distinct from investigation. Investigation is a critical examination, 100% assurance. Audit is only reasonable assurance. Scope of audit is general and broad, whereas investigation is specific and narrow. Now going on to benefits of audit. Why is audit needed? For you to remember the points, you need to remember the stakeholders. So when there is a question about benefits of audit, what are you going to remember? The stakeholders. Because audit is done for what, guys? To give the confidence to the users of the financial statements. Who are the users of the financial statements? The shareholders, employees, government, lenders, bankers, all of these people are the stakeholders who are the users of the financial statements. So see here, when they ask benefits of audit, you are going to start off with these accounts which are audited provide high quality information. It gives the confidence to the users that the information on which they are relying is qualitative. That means high quality information, and it is the outcome of an exercise carried out by following auditing standards which is recognized globally. In case of the company, the shareholders are the people who are like the owners of the company, but unfortunately they cannot be involved in the day-to-day operations of the company. So they will be seeing the audited financial statements, and that is the benefit of audit for shareholders. For employees, if nobody is there to come and check on them, where is their morality going? So when an auditor comes and asks them question, it acts as a moral check on employees from committing the fraud for the fear of being discovered by the audit. For government authorities, every company is going to pay taxes to the government. So if they say 30% tax, whether really are they paying the taxes properly? This much only profit is there for this company. Somebody has to sign and give. When the auditor signs and give, the government authorities are going to trust that tax liability which is given by the company. For lenders, bankers, whether I should give the loan to make the credit decisions, it is going to help them when there is an audited financial statement. When you do the audit, it also helps you to detect any fraud or error or both. An audit reviews existence and operations of various internal controls, which is used for pointing out the deficiency. About internal control in SA 315 in depth, we will be studying. Do not worry. So when they ask benefits of audit or why is audit needed, the one word which has to come to your mind is stakeholders. You're going to start off the answer by saying this audited accounts gives high quality information. This is basically giving a confidence to the users that the information which is with them is qualitative in nature. Second, shareholders. As shareholders will not be involved in the day-to-day affairs of the company, this acts as a proof for them that the affairs are going well. So the shareholders also are in need of the audited financial statements. Employees. This acts as a moral check on employees for committing the frauds. For government authorities in determining the tax liabilities. For lenders and bankers to make their credit decisions. An audit also helps in detecting fraud or error or both. An audit reviews the existence and operations of the internal control. Now we saw the benefits of audit. Whenever there are advantages in life also, if you see, if there is an advantage, there is always a disadvantage. Now we are putting AC here. This AC is advantageous in this hot weather. It is keeping us cool, but there is also a disadvantage. In the long run, this AC is going to contribute to the carbon emission, global warming. So that is a disadvantage. Anything that we do has advantages and disadvantages. We only have to weigh both and see if advantages is more than the disadvantages and proceed with it. Is that clear? Now for audit, we saw the advantages. Now we are coming to the limitations of audit. The auditor is not expected to and cannot reduce the audit risk to zero because there are inherent limitations of an audit. What are the inherent limitations? The first one being nature of financial reporting. What is the meaning of financial reporting? In your CA final, your paper number 1 is called as financial reporting, which is nothing but your accounting. So the nature of accounting is such that there are some judgments involved. There is some uncertainty involved. Then in that case, what to do? You cannot give full assurance, right? So the nature of financial reporting itself becomes a limitation of audit. Ma'am, you told judgment uncertain. Where is it coming? You all are putting provision of bad and doubtful debts. You are simply putting debtors is 1 lakh, means 10% of 1 lakh, 10,000 is provision of bad and doubtful debts. Who told you that 10,000 will definitely be bad and doubtful debts? It could be 20,000, it could be 50,000, it could be that entire 1 lakh, it could be zero also. You are only using your professional judgment and also your experience based on the past and telling that 10%. Basically, you are making a judgment and you are doing the accounts. So the nature of accounts itself becomes a limitation for audit. The nature of audit procedures. There are practical and legal limitations on the ability of the auditor to obtain the audit evidence. What is the practical limitation? The auditor does not test all the transactions and balances because it is difficult for him. He has to go for sampling basis only. That is the practical limitation of audit procedure. What is the legal limitation? Okay, auditor is going and asking questions to the management. How will I know whether management is really giving me the complete information, or how will I know if the management is giving me the right information? I still have to trust the management. That is the legal limitation. Management may not provide complete information. There is no way where the auditor can force the management to give the complete information. In case he is not provided with the required information, he can only show that in his report. Yes or no? So the nature of audit procedures is talking about practical limitation and legal limitation. Audit is not in the nature of investigation. Audit is not an official investigation, because investigation is 100% assurance. You are giving a guarantee. But here, there is nothing like that. It is only a reasonable assurance. 99.9% also if you give, that 0.1%, anything can go wrong. So, not in the nature of investigation. It is like you are writing your exam and coming. If someone calls me, I ask them, how did you do your exams? They'll be like, yes, ma'am, I did my exam well. I'll be like, will you pass? And then they'll be like, I will pass, ma'am, if ICA decides to pass me. What is that if ICA decides to pass you? Why will you not pass either ways? If ICA has a good pass percentage, bad pass percentage, whatever it is, you should feel like you did the exam well, you should pass. Then one student was like, ma'am, I cannot give full guarantee. I can only give a reasonable assurance. So in life also, you all are practicing to give that reasonable assurance only. Yes or no? So that itself becomes a limitation for audit, that it is not in the nature of official investigation. Timeliness of financial reporting. The relevance of the information decreases over time. Some things at this point it will look like it is very important. After 1 year, oh, that happened that day. I don't even remember the date. Happened to you? It has happened to me also. So the relevance of the information, today's information is important today. Tomorrow, yesterday's information goes to the dustbin. Like a newspaper only. Today's newspaper is only important for today. Tomorrow, if you see, then it becomes yesterday's newspaper, dustbin only, no other use for that newspaper. So the relevance of the information decreases over time. So the auditor, it is not possible to verify each and every matter. Therefore, there has to be a balance between reliability of the information and the cost of getting that information. Future events. Now I'm telling, as an auditor, this company is very, very good, sir. You can give the loan, you can invest your money. I am telling this company is very good in the next 5 years. Yes, definitely it is going to flourish like anything. Corona happened. Now, can anyone question the auditor saying, hey, you told it is going to flourish. What happened? Everybody is sitting at home. Can you ask questions like that? No. Future is always uncertain. You don't know what will happen in the future. So, if a future event affects the entity adversely, and adverse events may seriously affect the ability of the entity to continue the business. The business may cease to exist in the future due to change in market conditions, emergence of new business models or prospect products, or due to onset or some adverse events. Anything can happen in the future. We don't know what is going to happen. Yes, so that is future events. The 5 points for inherent limitations of audit is nature of financial reporting, nature of audit procedure, not in the nature of investigation, timeliness of financial reporting, and future events. Going to audit requirements, mandatory or voluntary, but before I get into that, I want to come back to the mind mapping to let you know as to where we are at the moment. We started off with what is audit, responsibility of the management, interdisciplinary nature. Then we went to objectives, then we went to scope, includes, excludes. Then we went to the benefits of audit. For benefits, I told you to remember one word, stakeholders. And then we went to the limitations. What is left is requirement of audit and appointment. Whether audit is required for all the companies? No, audit is not required for all the companies by law. It is not mandatory for all. But under law, for few companies, it is mandatory. Under law, it is mandatory for all the companies which is registered under the Companies Act 2013. For all the banking companies, it becomes mandatory. Other statutory bodies, like say, for example, Electricity Companies Act, Cooperative Societies Act, Multi-State Cooperative Societies Act, Charitable Trust, all these people automatically audit becomes mandatory under law. Apart from this, say for example, partnership, HUF, LLP, audit is not mandatory for them as per law. However, they can have audit on a voluntary basis. The audit of proprietary entities, partnership firm, HUF, etc. Why they will have audit, I will tell you. They will want to have audit to see whether the affairs of the company are actually going on well. If there are 4 partners in the partnership firm, 2 are operating partners and the other 2 are basically only doing business development. Now, the other 2 are not involved in the day-to-day activities. They want to make sure that the affairs are happening well and good. For that, they will say that internal rules, I need the audit. We will have the MOA, AOA, and in that we will write that audit must be required. If that person is going for grant, or if they're going to the banker and they're asking for loan, they're not going to trust the financial statements without that most important signature. So when you go for loan, then your company might require audit, your firm may require the audit. When you ask for government grant, in that case also may require audit. So voluntary audit is for audit of proprietary entities, partnership firm, HUF, etc., where internal rules may require the audit, or whenever there is a sanction of a loan or a grant, then they may require the audit. The last part is appointment of auditor. Who is going to appoint the auditor? For a company, the shareholders in AGM. For a government company, it's comptroller and auditor general. For a firm, it is the partners of the firm. Now, one thing you have to remember is the report, the audit report, once it is prepared, it will be submitted to the person who is making the appointment only. So, in the case of a company, to whom will you give the audit report? The shareholders. For the government company, to whom will you give the audit report? The comptroller and auditor general. For the firm, to whom will you give the audit report? The partners of the firm. The audit report is always submitted to the person who is making the appointment. Yes, guys, with that, essay 200 comes to an end. But quickly, I want to revise before I leave you off, so that you have full grip in the basic standard. We started off with what is the definition of audit. Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. What is the responsibility of the management? Preparation and presentation of financial statements. Interdisciplinary nature of auditing, 4 foundation subjects and 3 inter subjects, the inter group 2 subjects, and then plus 1 human psychology also. What is essay 200? Overall objectives of an independent auditor and the conduct of audit in accordance with standards on auditing. Under that, we saw what is the objective. There were 2 objectives, and then we went to scope, what and all it includes in audit, what and all is not there as part of audit, benefits of having the audit, limitations of having the audit, requirement, for whom and all it is mandatory, for whom and all it is voluntary, and finally, who is going to make the appointment of the auditor and to whom the reporting will be done. Very, very clear, guys. Yes, I know I was a little slow here because this is a base standard. Don't worry, as the standards go, I will also increase my speed also. Don't worry about that. I just want you to have full clarity in the basics. That is the reason why I took my time, went back to the mind mapping again and again, because this is important, guys. This is really, really important. Clear? Very, very good. Yes, guys, now I'm moving on to essay 210. But before we get into the standard, there are a few basics for essay 210 that you have to finish off, and then only you will be able to understand what the standard itself is saying. So the mind map that you're watching on the screen is basically only for the basics before essay 210. If the mind map is looking big, that means it is only voluminous, but the content is going to be very, very easy, guys. Now here you're going to study about what is the meaning of engagement. You all know what is engagement, and what is the meaning of assurance engagement. Who are the parties who are there in the assurance engagement? What are the elements of assurance engagement? Are there different types of assurance engagement? Examples of assurance engagement. So this part you're just going to read about what is engagement and what is assurance engagement. Then you go to prospective financial information. You already know what is historical financial information. Prospective means in the future. So you will be seeing what is this prospective financial information, what is the difference between historical and prospective financial information. And then again you come to the basics, that is why are standards actually needed, what are the qualities of the auditor and duties in relation to engagement and quality control standards. Once we complete all of this, then the basics before SA 210 actually gets completed. What is an engagement, guys? You all know this engagement. Yes, engagement means an arrangement to do something. In terms of audit, an engagement is basically a formal arrangement, a formal agreement between two people, that is an auditor on one side and the client on the other side. Between the audit and the client, there is some kind of an agreement, correct? That agreement is called as engagement. What is the agreement here? The management is going to prepare and present the financial statements, give it to the auditor, and the auditor agrees to provide the auditing services. Now, this engagement, this agreement will be in a written format, and that is called as engagement letter. Is that simple? Very, very clear. This is basically an agreement between two people. This is our boundary in the court. Tandi neeyu varakudadu, nanu varamata. After this line, I will also not come. You should also not come. Like this, there is some kind of an agreement between the two parties that is called as engagement. Clear, guys, with the first one. Now I'm moving on to what is an assurance engagement. Just read the theory part and then I will explain it to you. Assurance engagement is an engagement in which the practitioner expresses a conclusion which is designed to enhance the degree of confidence for the intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. How many of you all understood this sentence? Tell me. No chance if you read like this. Now just listen to me. An assurance engagement means an engagement. You know what is the meaning of this word. Engagement means an arrangement to do something, a formal agreement between the auditor and the client, in which the practitioner is nothing but the auditor. The auditor is expressing a conclusion. A conclusion is nothing but the opinion that the auditor is giving. Now, this conclusion, which is designed for what? For the stakeholders to enhance the degree of confidence for the intended users. That is nothing but the stakeholders about the outcome of the evaluation or measurement of subject matter against criteria. That means what information that he is giving, that the financial statements are as per AFRF. So the criteria is the AFRF, subject matter is the financial information or the financial statements. Now see here, there are three parties here: a practitioner, a responsible party, and the intended users. Why are there three parties? Normally in engagement there will be two parties only, right? No. In your engagement also there are actually three parties there. Now you all tell me what actually happens in an engagement. A boy and a girl are coming together and they are promising that at a future date that they are going to get married. Now who is making the promise to whom? How many parties are involved here? I'm telling you one thing, guys. In the traditional engagement, in the actual traditional engagement, the boy and the girl is actually not required. Nowadays, we've made it so commercial, ring ceremony and all of those things. All that is not there. Traditionally, the parents of the boy and the parents of the girl come together and they make the promise that at a future date, I will give my boy, you give your girl. Now they are no more open for bookings. Both of them are for each other only. Like that, they are making a promise to each other in front of all the people who have come to eat and they are going to complain about the food. Yes or no? So there are three parties which is involved here: the boy's parents, the girl's parents, and the people who have come to see the promise. These three are the three-party relationship. Similarly, for an assurance engagement also, it is a tri-party relationship. There is a practitioner on one side, auditor. There is a responsible party of the other side, that is the management, and the intended users, that is the stakeholders on the third side. Three-party relationship. A practitioner is a person who provides the assurance. The term practitioner is broader than auditor. I will tell you why it is broader than an auditor. Responsible party for the preparation of the subject matter. I told you subject matter is basically the financial statements. Who is responsible for the preparation of the financial statements? The management. So the responsible party is nothing but the management. Intended users are the persons for whom the report is being prepared. For whom are they being prepared? For the stakeholders the report is being prepared. So the intended users are the stakeholders. Clear? With the three parties, and who are the three parties and why they are using practitioner instead of auditor. Instead of opinion, the terminology used is conclusion. For stakeholders, the terminology used is intended users. For financial statements, the terminology used is subject matter, and for criteria, the terminology used is accounting AFRF. The audit is related to historical information, whereas practitioner may provide assurance not necessarily related to historical financial information. Now I have to open the chart for you to understand as to why the practitioner is a broader term than an auditor and all of those things. Now, ICAI has something called as AASB, Auditing and Assurance Standard Board. This standard board is only giving the framework for all the engagement standards. Now, what are the engagement standards? We have assurance engagement on one side, and we have something called as agreed upon services. Please be with me, guys. I'm sure at the end of everything you will get a good understanding. Just be with me. Assurance engagement is where the auditor or the practitioner, now you know practitioner is whom, will be giving his opinion. This opinion can be based on the past or on the future. If it is in the past, we are calling that historical financial statements. If it is in the future, we will be calling that prospective or projected financial statements. Clear till here? Now, this historical financial statements are again split into three. One is called as absolute assurance. One is called as reasonable assurance. And the other one is called as limited or moderate level of assurance. Is that clear? Very, very clear. Now, the historical financial statements, that is based on the past, we've split it into three. The first one is absolute assurance. You know the name for that. It is called as investigation, where the practitioner will be giving 100% of assurance, guarantee. Reasonable assurance is called as audit, where the auditor will be giving a reasonable assurance. Now you understood. A practitioner, an auditor can be a practitioner. A practitioner is a broad term. An auditor is giving only a reasonable assurance. One part of the historical financial statements assurance engagement is only audit. What is this limited or moderate level of assurance? This is called as review. How you are going to remember this? Say for example, different types of guests are there. How many of you all like it when guests come home? Most of the time we don't like, correct? But when we like the person, we like it that they are coming home. Yes, when we like someone, especially from abroad, when they are coming, they will be getting gifts for us and they are coming. That time and all we like it that they are coming home. Now say for example, when a guest is coming home, they are telling us 1 week in advance. 1 week in advance they are telling us what are the items that you will be preparing for your guest. You will start with juice. As soon as they come, I have to give them juice. Then you go for starters. Paneer 65, chicken 65. All these starters you will be giving them. Then you go to soup. Oh, first to soup, then starter. Okay, something. Then you go for soup. Some clear soup, vegetable clear soup, something you are making. Now coming to the main course. What will be there in main course? Rice, noodles. What rice? Biryani. Noodles, gravy, some Manchurian, papad, must, pickle, must, curd, must. Rice is already there. Apart from this, is there anything that I have missed to give them a good feast? Oh yes, dessert, sweet, gulab jamun plus ice cream, payasam, kheer, all those things you have given a feast for them. Yes, this is the feast. You will be able to make this feast when the guest tells you when there is 1 week for you to prepare. This is one type of guest. This is type number 1. The second type of guest, they will tell you 1 day in advance. Machan, tomorrow I am coming to your house only. I am having lunch in your house only. He will inform us that tomorrow his lunch is in our house. 1 day notice is given. What you will give? You will still want to satisfy him. You will give biryani. Yes. As soon as they see the biryani, they will become satisfied. After biryani, always it comes with raita, brinji. What else? If possible, 65 plus bread halwa. Now it is a perfect combination. Even though items are less, is he really be satisfied with biryani, raita, 65 and bread halwa? Completely satisfied. So 1 day in advance, I am able to satisfy him even though the items are very, very less. The type 3 guess, I will tell you. Macha, I am on the way. I am coming to your house only for lunch. That time, how much time will be there for you to prepare? Hardly 20 minutes, 25 minutes. What you will be able to do is the national dish of India, that is the upma. Now, why I spoke about all these guests is basically when there is lots of time, you are able to give a feast. When there is little less time, you are able to do justice, but still it is not a feast. When there is no time at all, you will just do the upma and you will give. Coming back to our historical financial statements assurance engagement, for investigation, there is no time for you. You can dive deep into the subject and you can tear it and find so many mistakes. That is the absolute assurance. Here, you will be giving a feast. What is the second one? There is time, but still there is limited time only. You can give the biryani, satisfied dinner can be given, but it is only reasonable assurance, that is the biryani. Clear? That is audit. Limited or moderate level of assurance, I will tell you, for all the listed companies. For all listed companies, quarterly they have to file within 1 week to SEBI. Quarterly returns has to be filed to SEBI within a period of 1 week. Within 1 week, preparation, presentation, review, everything must be done. Very, very limited time. It is like saying, Macha, I am on the way. What you can give? You can give only the upma, that is the limited assurance, moderate level of assurance, not even reasonable, that is your review engagement. What is this prospective or projected financial statements? Will anyone give the financial statements for the future? Yes. When there is an investor who is coming in, he wants to know what is the future of this company. Please give me the next 10 years projection. So that is the prospective or projected financial statements. It could also be for non-financial information. For this, we have SAEs, standards on assurance engagement. For review, we have SREs, standards on review engagement. For audit, we have SAs, that is standards on auditing. What is this agreed upon services? Say for compilation, engagement and all, they will be agreeing between themselves for doing the related services, that is the standards on related services. There is no assurance here. Auditor need not be independent here. If you see here, Under assurance engagement, only historical and prospective projected is coming. Agreed upon service, there is no assurance. So auditor need not be independent. SRS 4400 and SRS 4410 are examples of agreed upon services. Review, if I have to say, SRE 2400 and 2410. They are examples for the review engagement. Essay, I can keep telling 200, 210, 700, 701, 705, 570, 500, 501, 520. All these are examples for your essays. Clear with this entire chart? If you want, please take a picture, a screenshot of this. I'll keep it on top itself. A screenshot of this so that you are very clear. Before we proceed forward, you have to know what is review engagement, what is audit engagement, what is investigation, what is related services, what is assurance engagement. Everything you have to. Assurance engagement split into two: historical, prospective, projected. Historical split into three: investigation, audit, and review engagement. Agreed upon services is standards on related services where there is no assurance, no independence is also there. Clear, guys? SAE examples I have not given. 3400, 3420, 3402. SRE I have given 2400, 2410. Essays you know. Yes, guys. This is also there in the material, but just the examples will not be there here. No assurance, no independence for agreed upon service. SRS 4400, 4410. Prospective or projected financial statements. SAE 3400, 3420, 3402. For historical, we have three: absolute, reasonable, and moderate. This is the investigation. This is audit. We have standards on auditing. For this SRE 2400, 2410. For you to remember, you please write feast, biri, and upma. For you to remember the points, for you to remember the example, you please write it down here and keep it. Is that clear, guys? Very clear. Now I'm proceeding forward. We saw the elements of assurance engagement. Here they're just explaining as to the appropriate subject matter. Subject matter is the financial information contained in financial statement. What is the suitable criteria? The AFRF standard, guidance, law, rule, regulations. What is SAI? Sufficient appropriate audit evidence. We keep using this terminology called SAI. Audit evidence means, audit evidence is the proof for you when you do the audit. What is the sufficiency and appropriate? Sufficient basically means quantity and appropriate means quality. For now, if you know this, it is enough. Evidence should be both quantitative and qualitative. That means it should be both sufficient and appropriate. That is the reason why we keep saying SAI, sufficient appropriate audit evidence. It should be a written assurance report. A written report is provided containing conclusion that conveys the assurance about the subject matter. What are the types of assurance engagement? Now I've given you the overview. Now if I read the theory, you're going to understand everything. The types of assurance engagement are three actually: investigation, audit, and review. Here two are given, that is reasonable assurance engagement and limited assurance engagement. Provides high level of assurance, provides lower level of assurance. Performs elaborate and extensive procedures, here few procedures. Draws reasonable conclusions, here it is limited review, so limited conclusions. Example is audit and example is review engagement. Examples of assurance engagement. Audit examples, it is reasonable assurance engagement. For limited assurance engagement, it is review. For examination of prospective financial information based on projections, reports on controls, operating and organization, provides assurance regarding design and operation of controls. What is prospective financial information? Based on the future and possible actions, practitioner may obtain SAI, sufficient appropriate audit evidence, to effect that management's assumptions on which the prospective financial information is based are not unreasonable. That means they are reasonable. Prospective financial information is properly prepared on the basis of these assumptions only. It is properly presented and everything is disclosed properly. This relates to the future events. While evidence may be available to support assumptions on which the prospective financial information is based, such evidence is itself generally future oriented. Auditor is not in a position to express an opinion as to the results shown in prospective financial information will be achieved. Therefore, the practitioner provides a report assuring that nothing has come to the attention to suggest that the assumptions do not provide a reasonable basis for projection. So basically, he will not be telling that whatever I'm telling is true and fair. He will say nothing has come to my attention to say that this is false. So I am concluding that this is true. Hence, such types of assurance engagement are only giving moderate level of assurance. Difference between historical and prospective, you already know historical is from the past, prospective is in the future. Historical financial information rooted in past events already occurred. Prospective is related to future events. Now comes the engagement quality control standards. What is SA? Apply and audit historical financial information. Standards on review engagement, review of historical financial information. Standards on assurance engagement, SAE, where did we see? For prospective or projected financial information. Other than audit and review of historical financial. SRS, agreed upon procedures to information, compilation engagement and other service engagement. The same thing, what is standards on auditing? What is SRE? Few examples. SAE and SRS, few examples are given. Now comes to why are standards actually needed? Why do we have to study SA 200, 210, 500, 501, 520? So many standards. Why is it actually required? Now, if I ask you a simple question, how to make biryani? What will you tell me? What are the ingredients to make biryani? What is the procedure to make biryani? You please tell me. You start off with rice. What kind of rice? It could be basmati. It could be jeeraga samba. Or it could be what else? Some kind of rice. Second, what is required? Tomato. Yes, definitely it is required. Third item, what is required? Ghee. Yes, ghee slash butter, very much required. Curd is required. Masala, biryani masalas as required. All those star, leaf, all those things. Yes, bay leaf, all these things are required. What other things are required for biryani? Curd, already I have entered curd. Water, if you simply keep the rice, nothing will happen. You need water to cook. So water is also required. Salt is required. Yes. What else can you think of? Onion is required. What else for biryani, guys? Quick. That's it. With this, can you make the biryani? Onion, tomato, butter, curd, masalas, water, salt and rice. Now, what you have done here is, you have given options for rice. You have told what are the masalas that you have to use. You have told water should be 3 times the rice quantity. Yes, whatever quantity, say 1 cup of rice, so 3 times of water. Salt, a pinch of salt. Onion, 2 onions, 4 tomatoes. Like that, you have given the ingredient list for biryani. So that one main ingredient you have missed out. What is it? Please tell me. Compulsory ingredient is chicken or mutton. No fish biryani and all. Compulsory ingredient. If you want, you put beans, carrot and all. In addition to this, you put it. But don't just put beans and carrot and make the biryani. You call it whatever else you want. Do not call it biryani. You call it pulao. You call it veg rice. You call it rice. But do not call it biryani. Biryani compulsory ingredient. You have to have chicken or mutton. Like this, you're giving a framework for doing a good biryani. Yes. Similarly, when you go for audit, there has to be a framework as to what are the compulsory ingredients, what are the options which is available for you. Yes, for rice we have options. Water, compulsory, it has to be 3 times as to that of rice. Like that, there is a framework which is given. So the framework for making a biryani, you all told me, the framework for audit is the auditing standards. That is the standards on auditing. The standards on auditing is basically going to tell you these audit procedures you have to do for you to get this audit evidence. If this audit evidence is not received, then you can try this audit procedure. You can ask inquiry with the management. Then you go to TCWG. Like that, the framework to conduct the audit and to report how you have to make the report. That also the standards on auditing is going to give you. So basically, for an auditor, how I have to behave when I go for audit. What are the questions that I have to ask? The framework is given by the essays. Why are standards needed? Remember the biryani example. Standards ensure carrying out of audit against established benchmarks at par with global practices. Globally, wherever you go, biryani is made this way only. It is at par with global practices. Nowhere they should just put the carrot and beans and call it as biri. No, that word should not come from it. You call it pulao, you call it fried rice, you call it anything else, but not biryani. Biryani means all these ingredients compulsory must be there. It is a benchmark that I am setting for all over the world. Standards improve the quality of financial reporting, thereby helping the users to make diligent decisions. If I call a biryani, the quality must be there. Yes, so these standards are going to improve the quality of the financial reporting. There is some kind of a uniformity when there is standards. You will not simply put what you want. You will put few cashews, you will put few cauliflower, and you will put meal maker, and you will call that as biryani. No. You call that as meal maker rice or cashew rice. No problem. I want uniformity when it comes to biryani, because biryani is not just a dish. It is an emotion in itself. So standards promote uniformity as audit of financial statements. Standards equip professional accountants with professional knowledge and skill. A person who doesn't even know cooking, if they look at all of these things, they will somehow make biryani. So basically, essay, the standards on auditing, is equipping an auditor to do his job properly. And finally, it ensures the quality of audit. So why are standards needed? It is the benchmark for global practice. It helps to improve the quality of financial reporting. There is some kind of a uniformity all over the world. It helps me with my professional knowledge and skills, and it ensures the quality. Duties in relation to engagement and quality control standards. It is a duty of the accountant, professional accountant, to see that standards are followed and engagement undertaken. However, a situation may arise when a specific procedure are required and the standard will be ineffective in a particular engagement. In such a case, the auditor has to document how he is doing alternative procedure. And if there is any departure, then you have to mention the reason for departure also should be documented. It is also to be noted that a mere disclosure does not absolve the accountant from complying with the accounting standards. Now, say for example, if you see in SA 315 for risk assessment procedure, the standard itself will say that you have to do these audit procedures as part of SA 315. That is, analytical procedures you have to do, inspection you have to do, inquiry you have to do, observation you have to do. Like this, the standard itself is saying. Now you are deviating from the standard and also doing recalculation or re-performance activity. Then in that case, you have to mention it separately and also give the reason for the departure. Document everything, because this documentation is going to be the proof for the auditor saying why I have not followed this. Is that clear? Then comes qualities of the auditor. How should the auditor be? The auditor should be with good temper, good integrity, good discretion, good judgment. He should have a clear headedness, and whatever he is saying, people should be able to trust him. That is the quality of a good auditor. In addition, he should also be culturally good, shine of culture and highest degree of integrity. He should be in a position of trust, and he should have good knowledge, exhaustive knowledge of accounting. All of these must be the tact, caution, firmness, good temper, integrity, judgment, patience. All of these a good auditor must have. Now I am moving on to essay 210, that is agreeing the terms of audit engagement. Now, 210 is basically, already I told you, it is basically making a line between the client and the auditor and saying this is the line, you should not cross this, I will also not cross this, where you're agreeing the terms, this is my responsibility, that is your responsibility. That is 210, agreeing the terms of the audit engagement. As always, before entering into the standard, we will be seeing the mind mapping so that you know what to expect from this standard. You will start off with objective of SA 210, agreeing the terms of audit engagement. Then we will move ahead with what is called as engagement letter. What are the contents of engagement letter? Who will be the party signing an engagement letter? Can you revise the engagement letter? All these things will be covered here. Then we go to 3 case study based questions. What happens if precondition is not present? Limitations, change in terms, recourse for auditor for non-agreement, and finally you go to recurring audit. Now first, this is the most important part because each of the 4 things can be a separate case study based questions. I will start off with objective engagement letter, come back to the mind mapping, then we will go to 4 cases, revise that multiple times, then only we will go to recurring audit. Is that clear? Very, very clear. SA 210 deals with auditor's responsibility in agreeing the terms of audit engagement with the management and where appropriate TCWG. What is the objective of the auditor here? The objective of the auditor is to accept or continue an audit engagement only when the basis upon which the audit is to be performed has been agreed through preconditions. What I want you to note here is they're talking about accepting or continuing. Normally, how you will tell? If someone comes and proposes, you will accept or you will reject. But here, accept or reject is not used. Accept or continue is used. Why is it used like that? If it is a new client, you will be accepting. If it is an existing client, you will be continuing that engagement. So that is the reason why they are talking about accepting or continuing an audit engagement only when the preconditions for an audit are present. Now you have to know what is the meaning of precondition. Confirming that there is a common understanding between the auditor and the management and where appropriate TCWG of the terms of the audit engagement. Basically, the objective of the auditor here with respect to agreeing the terms of audit engagement is he is going to see whether he can accept the engagement, accept a new engagement or continue an existing engagement if the preconditions are present. What is the preconditions? That there must be a common understanding between the auditor and management and where appropriate TCWG regarding the terms of audit engagement. With respect to what should the understanding be? With respect to preparation of the financial statement in accordance with the accounting standards. Who has the responsibility? The management has the responsibility for preparation of financial statement in accordance with AFRF. Now that is the first precondition. The second one, for such internal control as the management considers necessary to enable the preparation of financial statements that is free from material misstatement, whether due to fraud or error. That means for you to prepare the financial statements, there is an internal control which is there and that control is operating properly. That understanding must be there between the management and the auditor. First thing, the auditor will have to see whether he can accept or continue an audit engagement if there are preconditions. What are the precondition talking about? That there must be a common understanding between the auditor and the client with respect to 2 things. The first one is preparation of the financial statement as per AFRF. The second is for the internal control. The third is what are the management going to give the auditor? They are going to give the auditor access to all the information in the entity. If the auditor is going to ask for additional information, that also will be given by the management. And if the auditor wants to come to office and talk to our employees, that also access is given. Unrestricted access to people within the entity where the auditor determines it necessary to obtain the audit evidence. Here, what we are seeing is the objective of the auditor is to accept or continue an audit engagement where there are preconditions. This precondition is talking about a common understanding between 2 parties, that is the auditor and the client. This precondition is talking about the common understanding with respect to 2 things. The first one is preparation of the financial statements is as per AFRF, as per Schedule 3, as per accounting standards. The second one, they are having an internal control. And third, they are providing the auditor with 3 things: information, additional information, unrestricted access to people. Is that clear? Now, if you see this, that's it, the standard itself is saying. The objective of the auditor is to see whether he can accept a new client or continue the new client provided the preconditions are present. What is the precondition talking about? Whether there is a common understanding between the auditor and the management, where the preparation of financial statements as per IFRF, the internal controls are proper with respect to the financial reporting process, and they are providing the auditor with respect for all information, any additional information that the auditor needs, and he also has unrestricted access to all the people. Is that clear? This is the objective of the auditor with respect to SA 210. Objective of the auditor for SA 200 was different. SA 200, what was the objective of auditor? To obtain reasonable assurance whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. There we were talking about overall objective of the auditor. Here we are only talking about the terms between the auditor and the management. So here we are going to talk about whether the auditor will be able to accept or continue. He will be able to accept or continue if preconditions and the common understanding is there. Moving on to the next one, that is engagement letter. Engagement letter is basically a letter, a love letter, which is written by whom to whom? It is written by the whom? By the auditor to the client. How are you going to remember this? When you go for articles, and for people who want to do articles in Big Four, you all will be doing engagement letters. You will be preparing the engagement letter and you will make your partner sign and you will be sending it to the client place. So like this you can remember. So now I have told you what work you will do. So you will not forget, you are going to join an audit firm. So for the auditor, you will be preparing the engagement letter. It is sent by whom to whom? By the auditor to the client. For whose benefit is this engagement letter being prepared? For the benefit of both the parties to have that understanding that this is my job, that is your job. It is in the interest of both the auditor and the client to issue the engagement letter. This engagement letter, can we talk orally on call, saying this is my responsibility, that is your responsibility, please do it? Can you have this conversation on call? No. Engagement letter must always and always be in writing, and in writing they have to mention clearly about the nature of the engagement, the scope of the work, the agreed terms of the audit engagement. Everything will be mentioned, and this letter is sent by the auditor to the client. What are the things that is going to be included in the engagement letter? That is what we are going to see next. The objective of the engagement, the scope of audit, responsibilities of both the parties, of the auditor and the management, identification of applicable financial reporting framework, reference to the expected form and expected content of any report to be issued by the auditor, and the statement that there may be circumstances in which a report may differ from its expected form and content. If a law or regulation prescribes in sufficient details the terms of the audit engagement, the auditor need not record them in written agreement except for the fact that such law or regulation applies and that management acknowledges and understands the responsibility. In some cases, the law will tell that you have to do the audit in a certain way. So the law is telling that this is your responsibility and this is the other person's responsibility. In that case, again a written engagement is not required, provided the auditor should be satisfied that the other party has understood his responsibilities. Now read the sentence again. If the law or regulation prescribes in sufficient details the terms of the audit engagement, then the auditor need not record them in the written agreement except the law or regulation applies and the management acknowledges and understands the responsibility. If they do not acknowledge, then the auditor is having trust issues whether he has actually understood. In that case, he is going to give the written engagement letter. Clear with what is the engagement letter, how this love letter is done, who is doing to whom, all these things are finished? Yes. Now I'm moving on to the 4 cases. Before that, in SA 210, we started off with the objective of SA 210. Then we went to engagement letter. Now I'm coming to the 4 cases. What are these 4 cases? What happens if preconditions is not present? Limitation on scope prior to acceptance. Changes in terms of audit engagement. Is there a recourse for audit? Situation of non-agreement. If the preconditions are not present, that means what? If there is no common understanding between the two people, then the auditor has to discuss the matter with the management. Unless required by law or regulation, the auditor will not accept the proposed audit engagement. Only if the law says I'm going to accept, otherwise simply I will not accept if the preconditions are not present. The objective of the standard itself is saying accept or continue the audit engagement if the preconditions are present. If it is not present, I will first discuss the matter with the management. If the auditor has determined that the financial reporting framework to be applied in the financial statement is unacceptable, if the agreement of management is not obtained on matters relating to understanding of responsibility of management on preparation of financial statement, internal control, and providing access to all the information, basically they are saying when the preconditions will not be there. If the agreement of management is not obtained with respect to the responsibility of the management with respect to preparation of financial statement, responsibility of management with respect to internal control, and responsibility of the management with giving the access to all the information and unrestricted access to people, or if the auditor determines that the accounting standard used to be applied in the financial statement is unacceptable. That means you are supposed to use AS or Ind AS, you are using US GAAP. Not acceptable. In that case, what should the auditor do? Precondition is not present. You please discuss the matter with the management. That's it, they are saying. What happens if precondition is not present? Discuss the matter. Don't use your weapon. Don't do overaction now itself. Just discuss is what SA 210 is asking you to do. So you will only discuss the matter with the management. If the law or regulation is asking you to proceed, no questions asked. Law is the supreme. You are going to follow the law. You will just proceed with the engagement even if the precondition is not present. Unless required by law or regulation to do so, the auditor shall not accept the proposed audit engagement. If the law or regulation is silent, then the auditor will ask the management as to why the preconditions is not there. That is the case number 1. Case number 2, limitation on the scope of auditor's work prior to acceptance of audit engagement. Even before the auditor is able to accept the engagement, he understood the type of client that he is not going to give any kind of information. Say, for example, the client is a politician. When he is asking you for your qualification and all of those things, he is asking in a very impolite manner. He is asking, oh, you are the auditor. Let me see what kind of information you are going to get from you. Ha 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 ha. Like that, he is laughing. And he is taking his big knife and he is asking, sir, for your sign, how much money, sir? Like that, he's asking with her knife and all. You are getting scared. Before you accept itself, you know that he is not going to give any kind of information. If the auditor believes that the limitation is going to result in disclaiming an opinion, that means there is no sufficient appropriate audit evidence, then he will not accept a limited engagement. He should not accept before itself if he knows that he is going to disclaim the opinion. Acceptance of a change in terms of audit engagement. Now, say for example, a boy and girl got married and the terms, conditions between them is Monday to Friday, you are in cooking team. Or always throughout the life, you are in cooking team, I am in vessel washing team. Like that, they have split between them. The terms is very, very clear. One person cooking, another person vessel washing. Very, very clear. Yes. Now, say for example, the boy is in vessel washing team, girl is in cooking team. Now, after the marriage, what the boy is saying is, hello, I can't be in vessel washing team and all. You think this is my job? I have lots of work. I can't do all this. He changed. Now, what should the girl do? Divorce. For everything, don't go for divorce. Wait. Patience is very required. You saw that for qualities of auditor, patience was there. Caution was there. Yes, patience is required. Please wait. The auditor will not accept where there is no reasonable justification in doing so. That means if he is saying, no, I will not be there in the vessel washing team, I can't do this work. If he is telling like that, you please go and ask him. What is the reason as to you have changed your mind? Before the marriage, you only accepted for the vessel washing team. Now why you are not doing it? What is the problem? Like that you ask for reasons. Now he is telling, see my hands. after doing the vessel washing. Hands has become so rough and blood is coming. Some allergy has happened in my hands. That is the reason why I am telling I will not be in vessel washing team. Now, people who told the divorce, you please think and tell. It is reasonable. What he is telling is very, very reasonable. If it is reasonable, then you can proceed. If it is not reasonable, what you should do? Basically, what they are telling is, if there is a change in terms, you please go and ask for reasons. Now, if there is a reasonable justification, then you will accept. If there is no reasonable justification, if he is saying, hey, like that only I told that time, now I'm going to tell like this, whatever you want, you do. Like that, if he is doing too much overaction, then you reject. You don't require that person. But first itself, don't go for rejection. First, you please ask for the reasonable justification. If it is reasonable, then you accept. If it is not reasonable, then only you go for rejection. Are you able to understand with respect to the change in terms between whom and whom? Now, not between husband and wife, between auditor and client. Now, if the client wants to change the terms, the auditor will ask for reasonable justification, and auditor will not accept where there is no reasonable justification. If there is a change in circumstance that is affecting the entity's requirement, a misunderstanding concerning the nature of service originally requested, restriction on the scope of audit engagement, whether imposed by management or caused by other circumstances, auditor considers the justification given, particularly the implications of restrictions on scope of the engagement. Case number 4 is the recourse for the auditor in a situation of non-agreement. Now, they are asking for something. They have told that, okay, you have this allergy. You please go to the cooking team. And I will go to the vessel washing team. I don't have any allergy. For 1 week, we will shift like that and we will see what to do. Now, he is telling cooking team means I will just to do the cooking. Cutting of vegetables, you should only do. Now, the girl is getting angry. Cooking team means end to end of cooking you should only do. How you can ask like that? Like that, some fighting is going on. If there is a situation of non-agreement, no one is agreeing. Should the girl just accept and say, okay, I myself will do the cooking, I myself will do the vessel washing? Yes, of course, if the girl is a housewife, it is okay. But nowadays, it is not like that. Both of them are working. So the household chores also must be both their responsibilities. Yes or no? Recourse for the auditor in a situation of non-agreement, change in terms of engagement, and lack of permission from management to continue the original audit engagement. In that case, the only thing is withdraw from audit engagement. You cannot do anything in this circumstance. You only have to withdraw politely. Determine whether when you withdraw, see whether you have to tell to other people. For example, when husband and wife got into agreement, fighting happened, they are withdrawing. It is not just the two people. You have to inform to parents that this happened. Yes or no? So see, in an audit engagement also between auditor and client, see whether you have to inform to the owners or those charged with governance, report to owner or those charged with governance or the regulators if it is necessary. If there is an obligation, either contractual or otherwise, to tell to all these people before withdrawing, you please inform to these people and then only you withdraw from the audit engagement. Clear? With the 4 cases, we started off with the first case. What happens if preconditions for an audit is not present? Then he will discuss the matter with the management. Unless required by law or regulation, he will not accept the proposed engagement. Limitation on scope prior to acceptance. Even before accepting, I know there is going to be a limitation on the scope of my engagement. I will not accept a limited audit engagement. Acceptance of a change in terms of audit engagement. Whenever there is a change in terms, what will you ask? Reasons. If there is a reasonable justification, you will accept. If there is no reasonable justification, you will reject. Recourse for the auditor in a situation of non-agreement, then you have to withdraw from the engagement. But before withdrawing, see whether there is an obligation, either contractual or otherwise, whether you have to report to the owners, whether you have to report to TCWG, or whether you have to report to the regulators. Is that clear? Very, very clear. Now in the mind mapping, we have completed the objective, engagement letter and the 4 cases. The last part of recurring audit is pending. What is the meaning of recurring? Recurring means it happens again and again. So in audit also, recurring audit is an audit which is performed by an auditor over the years. Over the years, the same person is doing the audit. In that case, how should the engagement letter be? Should they revise the terms of audit engagement or remind the existing terms to the entity? In these cases, 8 cases, you will think the following factors may make it appropriate to revise the terms of audit engagement or to remind the entity of the existing terms. What are these 8 cases? The first one, an indication that the entity misunderstands the objective and scope of audit. We have given the engagement letter. You have told the responsibility of the preparation presentation is of the management, but still the management has misunderstood. In that case, you will be giving them another engagement letter to remind them of their terms, or you will revise the terms of the audit engagement. An indication that an entity misunderstands the objective and the scope of audit. Any revised or special terms of audit engagement. Revised or special terms. Now only I am revising the terms. In that case, obviously I have to revise my engagement letter also. Now the person who signed at that time, he is no more there. He got promoted to some other department. A change of senior management has happened. Now that engagement letter was signed by somebody else. Now another person is sitting in his place. In that case, this person should not be like, I did not sign, I am not responsible. So you please give another engagement letter if there is a change in senior management or if there is a change in ownership. Change in the size of the business or nature of the business. When we first signed the engagement letter, the fees was set at 5 lakh rupees because the entity itself was making a revenue of only 50 lakh rupees. So fee was 5 lakh. Now the entity has become, over the years, the entity has become huge. They're making 5,000 crores. Can I still do the audit for 5 lakh rupees? No. I will ask for 25 lakh because now the amount of audit that I have to do has also increased in size. So I will want to do what? Revise the terms of audit engagement or remind the entity of existing terms. I will be revising my fees. I will be revising the terms of audit engagement. So whenever an audit is happening over the years, we are under recurring audit. Do not forget that whenever an audit is happening over the years, we are seeing when we have to revise the terms. When there is a change in the size of the business, change in ownership, change in senior management, change in the terms of audit engagement itself, then definitely engagement letter has to be changed. A change in the legal requirement, change in the financial reporting framework, accounting standard was followed suddenly in days. In days, can I do the same fees? No, I will increase my fees. Or change in any other reporting requirements. If it is there, then I will be changing my engagement letter. I will either revise the term or I will remind the entity of the existing terms. A recurring audit is basically an audit which happens over the years because an auditor can be appointed for 5-year period. So obviously after the second, third year, they will become too friendly with each other. At that time, you can see whether the engagement letter has to be revised or not. After 5-year period, what happens, guys? Again, the same person can be appointed for another 5-year period. So an auditor can be appointed for 5 plus 5 years. 10 years an auditor can be appointed. And then there has to be a cooling period of 5 years. And again, he can be appointed for 5 plus 5 years. It keeps going on. Is that clear? This is essay 210. We started off with objective, then we went to engagement letter, who prepares the engagement letter, to whom the engagement letter is given, and all of those things. Then we went to the 4 cases, and then last part, recurring audit. In the time of recurring audit, at what time you will be revising the engagement letter or you will be reminding about the terms in the engagement letter. That is essay 210. Like I said, guys, more than 210, if you ask me, the basics before essay 210, all these points we saw, correct? That one is important because here you spoke about prospective financial statement, historical financial statement, what is assurance engagement, difference between the prospective, historical, why are standards needed, what is engagement, qualities of auditor, all those things we first saw. Then only we went to essay 210, guys. Yes, I know in a marathon, I am going quite fast, quite slowly, because these are base standards, 200 and 210, very, very basic standards. After this, you can slowly see the increase in speed. That I am giving you an absolute assurance for you all, guys. Yes, all the very best, guys. That's it. With this, essay 210 comes to an end.
Essay 700. In the mind mapping, quickly we'll finish off what is there in essay 700. The first one is the objective of the standard. What is the meaning of unmodified opinion? To form an opinion, auditor is to obtain reasonable assurance for that what and all he has to do. And finally, we have elements or contents of the audit report. Now, the objective of the standard, essay 700, is forming an opinion and reporting on the financial statements. If you remember, I told you the objective itself is the name of the standard, forming an opinion and reporting on the financial statements. The first objective is to form an opinion on the financial statements based on the conclusions based on audit evidence. Second is the reporting requirement, to express clearly that opinion through a written report. These two are the objectives of essay 700. What are these two? To form an opinion on the financial statements based on evaluation of conclusions drawn from the audit evidence which is obtained, and second, to report, to express clearly that opinion through a written audit report. The first one is objective. The objective itself is name of the standard. The second is unmodified opinion. What is the meaning of unmodified opinion? Unmodified opinion is when the auditor feels that there are no mistakes in the financial statements. That means the financial statements are prepared as it is supposed to be prepared. What is that supposed to be prepared? As per the accounting standards, that is AFRF. The auditor shall express an unmodified opinion when the auditor concludes that the financial statements are prepared in all material respects in accordance with AFRF. That means the financial statements are as per the accounting standards only. The third is to form an opinion. The auditor is to obtain the reasonable assurance. The auditor shall form an opinion on whether the financial statements are prepared in all material respects in accordance with AFRF. In order to form that opinion, the auditor will conclude as to whether the auditor has obtained reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. Now, for you to make this conclusion that there is a reasonable assurance that the financial statements as a whole are free from material misstatement, for you to make this conclusion, you have to look at these points. Whether SAI has been obtained, whether if there are any misstatement, and if that misstatement is uncorrected, is it still material? Whether uncorrected misstatements, whether they are material. And finally, few evaluations of the qualitative aspects and specific evaluation. What is this evaluation of qualitative aspects? What is this specific evaluation? The specific evaluation is talking about selected and applied significant accounting policies, whether they are adequately disclosed and whether they are consistent with the AFRF. That means you have to disclose the accounting policy and it has to be consistent. If there is any change, then you have to give in notes to accounts about the description as to the change and also the reasons as to why your accounting policy has changed. Accounting estimates which is used by the management, whether they are reasonable or not. Information in financial statements, whether it is relevant, reliable, comparable and understandable. All the disclosures which is there in the financial statements, whether it is adequate and whatever terminology that you have used is appropriate. All of these are the specific evaluations which you will be doing. Evaluations of qualitative aspects of the accounting practices. What is that qualitative aspects? Now this is only for the accounting practices. So for accounting, there will be lots of bias by the management. There can be judgments. There can be bias. If there is no neutrality, that means as the management, when they are preparing and presenting the financial statements, they should not be biased. So they have to be neutral. Indicators of lack of neutrality. That means when they are making the estimate itself, I told you an example for this, that say the director is there. Director's ex-girlfriend has purchased the materials. Now, how the director will think that she is definitely not going to return that money. She's not going to pay for whatever she has purchased. Like that, he's going to think and he's going to create provision for bad and doubtful debts for that entire amount that she has purchased. Now, is there neutrality here? No, he is allowing his bias to come here for this provision for bad and doubtful debts. So, possible management bias in the making of accounting estimates or selective correction of misstatement which is brought to the management's attention. What is this selective correction of misstatement? Anything which is going to increase my revenue, I am not going to correct it. Anything which is going to reduce my revenue, okay, fine, I will correct. They're doing like that because they want the investment, they want to show high revenue. The opposite is also possible. Anything which is reducing the revenue, they're saying okay to correct. Anything which is increasing the revenue, they are not okay to correct. When is this scenario? When they have to pay the tax. When they don't want to pay the tax, they want to keep the revenue down. When they're looking for investments, they want to keep the revenues up. So, if there is any selective correction, that is also a lack of neutrality. If you are able to see something like that, then there is a qualitative aspect evaluation which you will be doing. After doing all of this is when you will be able to see that the financial statements are free from material misstatement, whether due to fraud or error. Is that clear? Yes. Further, when financial statements are prepared in accordance with fair presentation framework, the evaluation mentioned above shall also include an evaluation by the auditor as to whether the financial statements achieve that fair presentation framework, which shall include the overall presentation structure and content, and whether financial statements, whatever is happening in the financial statements, is actually whatever happened in real life also. What is this fair presentation framework? What is that fair presentation framework? Actually, whatever has happened, that only he has to report in the financial statements. That is only fairly presenting the financial statements. Example? Now, the standard might tell you that you have to do something. This is the form. But in reality, the substance, it is something different. So, give importance to substance over the form. Somewhere in your disclosures, you can mention that for this reason I have deviated from the standard. That is that fair presentation framework. Is that clear? Yes. Going to the next part, which is elements or contents of audit report. Again, going to mind mapping, we saw the objective. Objective is nothing but the name, forming an opinion and expressing clearly with the written report. Unmodified opinion means that the financial statements are prepared as per AFRF. And third, to form an opinion, auditor to obtain reasonable assurance. Here we saw that the auditor will want to obtain reasonable assurance that the financial statements are free from material misstatement due to fraud or error. This conclusion is based on all of these things, whether that sufficient appropriate audit evidence is there, whether any misstatements are there, whether that misstatements are uncorrected, and whether it is material in nature, and few evaluations that they have to do. Specific evaluations are there, qualitative evaluations for the accounting practices are there, and finally about fair presentation framework also we saw. Now going to elements or contents of the audit report. The first one is the title of audit report. Whose audit report did we take? Now, Reliance Industries audit report. What are they talking about? The title. The audit report shall have a title clearly indicates that it is the report of the independent auditor. For example, here if you see independent auditor's report is written there. That is the title of the audit report. The next one, addressee. To whom are you going to address? The audit report shall be addressed as appropriate based on the circumstances. Law, regulation or the terms of engagement will tell them whom you have to address. Normally, to whomever you are preparing the report for, you are going to address for that person. For a company, it is going to be shareholders. For firm, it is going to be partners. For a government company, it is going to be C and AG. You are clear with that, correct? So this is a company. So here they have written to the members of Reliance Industries Limited. So it is addressed to the members, that is the shareholders of the company. The third title is the opinion paragraph. Auditor's opinion. The first section of the auditor's report shall include the opinion paragraph. So if you see in the audit report, it starts with the title to the members of, this is the report on standalone financial statements. What is the first section? It is the opinion paragraph. Now what are they saying? And it shall have the heading opinion. Was it there? Yes. The opinion section of the auditor's report shall also identify the entity whose financial statements have been audited, state that the financial statements have been audited, identify the title of each statement comprising the financial statements, refer to the notes including the summary of significant accounting policies, specify the date and the period which is covered. What and all are they saying? Identify the entity. Is Reliance Industries written here? We have audited for Reliance Industries Limited. Yes, identifying the entity is done. State that the financial statements have been audited. That is the first sentence. We have audited the accompanying standalone financial statements, which includes its joint operations, which comprise, like that. They are starting the sentence where they are stating that the financial statements have been audited. Identify the title of each statement comprising the financial statement. What is comprising the financial statement? Your P&L, balance sheet, cash flow statement. So the title has to be mentioned, which includes its joint operations, which comprises balance sheet as on 31st March, statement of profit and loss, statement of cash flow, statement of changes in equity. So all of these are the title which is comprising in the financial statements. Refer to the notes including the summary of significant accounting policies. Have they referred to the notes? And notes to the standalone financial statements including a summary of material accounting policy and other explanatory information. Specify the date or period covered by each financial statement comprising the financial statement. Here is it written 31st March 2024. The period also is written here. When expressing an unmodified opinion, unmodified means you are saying that everything is perfect, everything is as per AFRF. The financial statements are as per AFRF. When expressing an unmodified opinion on financial statement, unless otherwise required by law, you have to use one of these phrases only. First one is, you will be saying it presents fairly in all material respects. The second one is, it gives a true and fair view of the state of affairs. Now what should not be there is, once you write it presents fairly and it gives a true and fair view, after this you should not continue subject to. With regard to these explanations, like that you cannot continue. So the phrases present fairly and true gives a true and fair view are regarded as being equivalent. It is not appropriate to use the phrase what? Subject to with the foregoing explanation in relation to the opinion. So here what opinion are they giving for our Reliance Industries? In our opinion, and the best of the information according to the explanation, the aforesaid standalone statement in the manner so required give a true and fair view in conformity with the accounting standards, like that they have given. So next is basis for opinion. The audit report shall include a section directly following the opinion section with the heading basis for opinion. Here there are 4 points that you have to remember. The first one is, state that audit was conducted in accordance with standards on auditing. Second one, it refers to the section which describes the auditor's responsibilities. Third, it includes a statement that the auditor is independent of the entity. And last, I am doing all of this is only based on the sufficient and appropriate audit evidence, and based on this only I am giving the basis for audit opinion. Is that clear? These 4 points compulsorily has to be there in basis for opinion paragraph. What is the first one? Conducted as per standards on auditing. We conducted our audit on standalone financial statement in accordance with the standards on auditing. Is it there? What is the second point? Auditor's responsibilities. Our responsibility under those standards are further described in auditor's responsibilities. There. Third one, they have to mention that they are independent. We are independent of the company in accordance with Code of Ethics issued by ICA. What is the fourth one? Based on the sufficient appropriate audit evidence only, we are giving. See the last point. We believe that audit evidence obtained by us is both sufficient and appropriate to provide a basis for our audit opinion on the standalone financial statements. Is that clear? All 4 points compulsorily must be there in basis for opinion. They can ask, guys, in exam, even this part they can ask. If you are giving an unmodified opinion, how should the words be, how it should not be, and this basis for opinion, these 4 points, they can ask in exam as a direct question also. Now the first one is with regard to title, second is addressee, third is opinion, fourth is basis for opinion, and now the fifth one is material uncertainty relating to the going concern. What is the meaning of going concern? Going concern means that the company is going to go on forever. That means in the foreseeable future, I don't have any doubts that this company is going to fall. Like how all of us are also there, we keep wanting to go forward. 60 years also, if I ask you the question, you will say 5 more years I will see son's marriage, daughter's marriage. 70 years if I ask you, you will say granddaughter's marriage. 80 years if I ask you, you will say granddaughter now only has girlfriend. Like that you will keep on going. You will never accept for finishing off. The same way a company also going concern. The financial statements are prepared on the assumption that the entity is a going concern and it will continue its operations for foreseeable future. When use of going concern basis of accounting is appropriate, they are assets and liability are recorded on accrual basis of accounting. The auditor shall evaluate sufficient appropriate audit evidence has been obtained regarding and shall include on appropriateness of management's use of going concern basis. If you remember in essay 570, implications, first implication, what is it given? In essay 570, implications are there. Under that first implication, what is given? The financial statements are prepared as per going concern basis and the auditor feels that it is inappropriate. And that case, what opinion did he give? Adverse opinion he gave. Now here, what are they talking about? The auditor will conclude on the appropriateness of the management's use of going concern. Is that clear? Please connect and study. Whether any material uncertainty exists. Material uncertainty means there is a 50-50 probability that going concern might be affected, might not be affected. For this only example was Audi. For Audi, what they did a bad ad where they showed that each of the ring of the keychain represents each of the feature of a car. They said Mercedes-Benz, safety, BMW, sportiness, Jaguar, classiness. Like that they put 4 keychains and the rings of the keychain, and finally they showed only the logo and said all 4 are here. Now all the 4 people are irritated, they are mad at them, and then they went and filed a case asking for 1,000 crores per person. Now what happens? In case if Audi loses the case, Audi has to pay 4,000 crores outside the company when the revenue of Audi itself was only 4,000 crores. Now we saw that example, yes or no? The likelihood of occurrence of material uncertainty. What is the probability of it happening or not? For this only, what is the, if it is material uncertainty, it is 50-50. The next part is talking about probability of this material uncertainty happening or not. How will you know the probability? For example, a similar case is there with Horlicks and Complan. Now, if you want to become tall, you have to drink the Complan. Everyone knows that they have advertised it so much. So Horlicks gave a public service message saying, are you all fools? Are you, when someone is asking to become tall, what you have to drink means you all are telling Complan. Like that, Horlicks made a public service message and said, please open your eyes. You know it is not true, but still it is coming from your mouth. That means they have conditioned your brain through this marketing tactic. Like that, Horlicks has spoken. And Complan went and filed a case on Horlicks. Now this case, Complan has won the case. If Complan has won the case, now what will this judge say? What will this judge say? The probability of having the material uncertainty increases, because in this case there is a lot of possibility that Audi will also lose the case. And here, if they say, no, you cannot talk like this and all, you cannot use, sorry, you can talk however you want. If they are talking like that, you also talk like that. You say Horlicks, nothing, no Shakti is there. Like that, you put the ad like that. Judge has given the command. If it is like that, then in this Audi case, then the probability will become low. Is that clear? So the next point is basically talking about likelihood of occurrence of the material uncertainty. How will we know? Based on other cases is how we will know what is the probability of this material uncertainty happening or non-happening. Appropriate disclosure of the nature and implications of uncertainty is necessary for both fair presentation and the compliance framework. The first one was title, second addressee, third opinion, fourth basis for opinion, fifth material uncertainty relating to going concern, and sixth is key audit matters. What is this key audit matters? Basically, for all the listed companies, key audit matters paragraph is compulsory. SA 701 is telling. In case if the auditor feels that CAM paragraph is required for public interest, then in that case also CAM paragraph will be there. Law or regulation may require communication of key audit matters for audit of entities other than listed entities. Now quickly jumping into SA 701, which is key audit matters. What is the mind mapping in SA 701? What is key audit matters? What are the definition? What is the objective? Applicability, how to determine the key audit matters, communicating key audit matters. Key audit matters is not a substitute for four things are there. Key audit matters will not be communicated if three things are there. Communication with TCWG. Now quickly let's finish this. What is this key audit matters? The auditor may decide to communicate key audit matters for other entities, including those that may be of significant public interest, for example, because they have a large number and wide range of stakeholders and considering the nature and size of the business. Usually it is compulsory for listed entities, but if the auditor feels that this paragraph must be there for public interest, then they can include the CAM paragraph. What is the definition? Key audit matters are those matters that in the auditor's professional judgment were of more significance in the audit of financial statements of the current period. Key audit matters are selected from matters communicated with those charged with governance. There are 2 points to remember here. First one is it will always pertain only to the current period, and the second one is you should always communicate whatever you are going to show in the key audit matters with those charged with governance, and then only you will show it in the key audit matters. What is the objective of this standard? It is to determine the key audit matters, and after forming the opinion, it is to communicate the matters, describing them in the auditor's report. Who has the applicability? First one, listed entities. Otherwise, if the auditor decides to communicate based on public interest or if it is required by law or regulation. However, SA 705 prohibits the auditor from communicating CAM when the auditor disclaims an opinion on the financial statements unless such reporting is required by law or regulation. Basically, if there is a disclaimer of opinion, in that case, CAM paragraph should not be there. However, law is the mother. If law says CAM paragraph should be there, then even during disclaimer of opinion, CAM paragraph will be there, because here applicability, it is written, it is required by law or regulation to communicate the key audit matters. Is that clear, guys? So for unmodified opinion, can CAM be there? Yes. For modified qualified opinion, can CAM be there? For adverse opinion, can CAM be there? For disclaimer of opinion, yes, CAM can be there if law or regulation requires the CAM. Like that, you have to put it in your head. Is that clear? Going forward, how to determine the CAM? You are saying it is key audit matters. What is making it key? What is making it important? For that, 3 points are there. First one is high risk of material misstatement as per SA 315. Risk of material misstatement means there is a risk that the possibility of mistakes can happen, and that mistakes will be important mistakes. So if the risk is high, then you will be communicating that with the key audit matters paragraph. If any kind of accounting estimate is having high uncertainty, then you can show it under key audit matter paragraph. Or any other significant event or transaction, if it happens, then you can show that event or transaction also in the key audit matter paragraph. How to determine the CAM? 3 points are there. What are the 3 points? Quickly tell me. If high risk of material misstatement as per SA 315. Second, significant event or transaction happens. And last one, accounting estimate if there is a high uncertainty. These 3 points, if it is there, you will be determining the CAM with the help of 3 points. Communicating the CAM. The auditor shall describe each key audit matter using an appropriate heading in a separate section of auditor's report under the heading key audit matters. The introductory language will have key audit matters are those that in the auditor's professional judgment are most significant. These matters were addressed in the context of the audit of financial statements as a whole and in forming the auditor's opinion thereon. The auditor does not provide a separate opinion on these matters. For example, if there is a high risk of material misstatement in a specific area, because of that I am giving an adverse opinion. Can there be a possibility? There is an important event which happened, because of that I am giving a modified opinion. Is that possible? No. So these three, if it comes, you will be giving only a key audit matter. This is not a replacement for a separate opinion by itself. Communicating CAM, not a substitute for. Here 4 points you have to remember. The first one is, if there has to be a disclosure in the financial statements, that has to be shown in the disclosure only. You can't say instead of disclosure I showed in key audit matters and all. So it is not a substitute for disclosure. It is not a substitute for SA 705, modified opinion. It is not a substitute for SA 570, going concern paragraph has to be separate. You can't say in key audit matters I spoke about going concern, so in the going concern paragraph I'm not talking about it. You cannot say that. It is not a substitute. And finally, it is not a substitute for separate opinion. What are the 4 points where CAM is not a substitute for disclosure in the financial statement? First one, disclosures in the financial statement. Second, it is not a substitute for any modifications as per SA 705. Third, it is not a substitute for going concern paragraph as per SA 570. And last, it is not a substitute for separate opinion. CAM will not be communicated if a law or regulation prohibits possible adverse consequence or highly confidential. Basically, if something is highly confidential matter, you will not be showing that in your CAM paragraph. If there is an adverse consequence, or if the law or regulation prohibit, anyway you will not show. These two are basically going to weaken the whole standard. So, because highly confidential information will not be there in CAM, will you go and read that CAM? No. What are they given in CAM here? Key audit matters, some litigation matters, matters relating to oil and gas, disallowance of some certain costs, claim against the company have migrated to neighboring block. Nothing we are understanding what is that block and all. Matters relating to trading in shares of Reliance Petroleum Limited. Some judgment has come dismissing company's appeal. Fair valuation of investment. Company has investment of 78,000 crores in Geo Digital Fiber, which are measured at fair value as per Ind AS. Our procedures were not limited to the following. What they are trying to say? IT systems and control over financial reporting. Here they are tested the design. Some key audit matters. Anything confidential here? They are only saying what is there. Nothing is confidential here. And if it is having an adverse consequence, if I see that and if I not invest, if I see that I will not give the loans. If there is an adverse consequence, you will not even show that in CAM paragraph. That is why this weakens the section itself. This weakens the whole standard itself. And whatever you have to show in CAM, you will be communicating with those charged with governance. Those matters the auditor has determined to be the CAM, or if applicable depending on the facts and circumstances of the entity and the audit, the auditor's determination that there is no CAM to communicate in the auditor's report. Even if no CAM is there, you please mention that there is no CAM to mention in the auditor's report. In CAM, what and all did we see? What is key audit matters? Now I'll tell you one small example. Let me see if you're able to answer it. Okay. Now, I found out that the previous year figure is there, correct, in the financial statements. I'm going to sign on that also. So in the previous year, in the opening stock of the previous year or some purchase of the previous year, some stock valuation, I am a little doubtful. So I feel that the risk of material misstatement is high in that case. So I spoke to the TCWG. There is no adverse consequence. It is not a confidential information and all of those things. I spoke to TCWG. They said, okay, you proceed. You can put it in CAM. So I have shown it in the CAM. Is it correct? Who and all are saying it is correct? Why is it not correct? It is not confidential. It should pertain only to the current year. I told you previous year some purchases, some problem was there. I don't know how many of you all noticed that. CAM should always pertain only to the current year. Key audit matters, the auditor may also decide to communicate CAM for entire entity. We saw definition. What is it? It should pertain only to current period, and key audit matters are selected from whatever is communicated with those charged with governance. What is the objective of the standard? To determine and to communicate in the audit report. Who it is applicable for all listed entities. If the auditor decides that it is applicable in terms of public interest, or if it is required by law or regulation. When CAM paragraph will not come, when there is a disclaimer of opinion and law or regulation is not saying anything, then CAM paragraph should not come. How to determine the CAM? When there is high risk of material misstatement as per SA 315, when the accounting estimate, the high uncertainty is there and there is a significant event or transaction. You will be communicating to the CAM. To whom? To those charged with governance before you show it in the audit report. When you will not show in the CAM, that is, it is not a substitute for 4 things. Disclosures, 570, 705 and separate opinion. CAM will not be communicated if law or regulation prohibit. Possible adverse consequences are there, and highly confidential information CAM will not be communicated, and CAM should always be communicated to those charged with governance. Even if CAM is not there, you will be mentioning in the audit report that there is no CAM. Next is other information where applicable. For this only SA number you have to remember, that is SA 720. Responsibilities for the financial statements. There is auditor's responsibility and there is management's responsibility. Now, responsibility of management for the financial statements. What is management's responsibility? For the preparation and presentation of financial statements. And I also told you the internal controls, which is by whom, for whom? By the management, for the management. That is also the responsibility of the management only. Preparation of the financial statement in accordance with AFRF, and for such internal control as management determines it necessary. Assessing the entity's ability to continue as going concern. Who is going to see whether entity is continuing as going concern? Management will be seeing whether entity is continuing as going concern. As an auditor, we will be seeing whether it is appropriate or not. Oversight of the financial reporting process. This section of the auditor's report shall also identify those responsible for oversight of the financial reporting process, when those responsible for such oversight are different from management. In this case, the heading shall also refer to those charged with governance or such term that is appropriate in the context of legal framework applicable to the entity. So the financial reporting process is nothing but the accounting process. There will be somebody to see the oversight of this accounting process. If it is different from management, you have to mention that in this paragraph, responsibility of the financial statements. Usually it will be those charged with governance. Auditor's responsibility. There are 3 responsibilities. What is it? Objectives of the auditor. Reasonable level of assurance is high level of assurance, but it is not a guarantee that misstatements can be due to fraud or error or both. Apart from this, the auditor's responsibility section to further talk about auditor will exercise the professional judgment and maintain the skepticism. Describe an audit by stating the auditor's responsibility. If SA 600 applies, describe auditor's responsibility in group audit. That means SA 600 is what? Using the work of an other auditor. If I'm going to use the work of another auditor, in the responsibility of the auditor section, please mention describe auditor's responsibility in group audit. Now, are you the principal auditor? Are you the other auditor? Like that, you have to describe your responsibilities. Now, when you're describing the auditor's responsibility, what is it? What and all are you talking about? This is SA 315, identifying and assessing the risk of material misstatement. This is also SA 315, understanding the entity and its environment, that is to obtain an understanding of the internal control system, to evaluate the appropriateness of accounting policy, to conclude appropriateness of going concern, that is 570, to evaluate overall presentation structure and content of financial statement, that is fair presentation framework. Is that clear? This is auditor's responsibility. 10th is location of the description of auditor's responsibility for the audit of the financial statements. The description of auditor's responsibility, where and all will be there. They are asking for the location of the description of auditor's responsibility. Where and all will this auditor's responsibility will be there. It will be there within the body of the audit report. It will be there within an appendix to the audit report, and any specific reference within the audit report to the location if there is any on the website. Just see here, after key audit matters, responsibility of management is there. Auditor's responsibility is also there. If you see, identifying and assessing the risk of material misstatement, obtaining an understanding of internal financial control, evaluate appropriateness of accounting policy, all of these points, did we see that? Conclude on the use of going concern, evaluate overall presentation structure and content, all of this we saw. Now it is there in the body of the audit report, and it will also be there in the appendix, is nothing but the annexures. So annexure A, auditor's responsibility, is it there again? So the location is there in 2+1 places. One is the body of the audit report, second is the annexure, that is the appendix to the audit report, and third is a specific reference within the audit report to the location of such a description on the website if it is appropriate. So 2+1, you remember like that. What is this other reporting responsibilities? This is nothing but your CARO. That means apart from what and all I have to do from standards on auditing, is there something else that I have to report on? Yes, CARO is giving 21 clauses. You have to report on those 21 clauses compulsorily. That is your other reporting responsibilities. The next one is signature of the auditor. Now here, along with the signature, there must also be membership number, firm registration number. The partner or proprietor signing also needs to mention the membership number assigned by ICI. Here, is it there? Yes. For Chaturvedi and Shah, for Deloitte Haskins, oh, there are two partners. Joint auditor for Reliance Industry. Now, they are talking about firm registration number. Is it there? Yes, for both of them it is there. Name of the partner, it is there. What other things they asked? Membership number, is it there? Yes, for both the partners it is there. This is what? Signature of the auditor. The next is place of signature. The auditor's report shall name specific location, which is ordinarily the city where the audit report is signed. Place of signature is where both are in Mumbai. That means both are signing the audit report in Mumbai. They can ask questions like, I am signing in Mumbai, but I did the audit procedures in Bangalore and I gave the report in Chennai. So what should be the location? Whenever they sign, here sign is only given, correct? Like that you remember. This is the signing place. So where they are signing, that place has to be given here. Like that you can remember, guys. That is place of signature. Next is date of auditor's report. The audit report shall be dated no earlier than the date on which the auditor has obtained sufficient appropriate audit evidence, because the flow is like this. the engagement letter is being prepared, then the auditor will be doing all the audit procedures, he will be getting all the audit evidence, then he will reach the conclusion. Based on the conclusion, he will be giving an opinion. This opinion will be communicated in the audit report. This audit report will be given to the management. Management, along with all the other things, they will be preparing something called as annual report, and that annual report, which is inclusive of the audit report, will be given to the members, that is the shareholders. This is the flow. So the date of the audit report is here. They are saying it should always be after the evidence date. Isn't that correct? If you know the flow, this is just common sense. The audit report shall be dated no earlier than the date on which the auditor has obtained the sufficient appropriate audit evidence. All the statements that comprise financial statements, including related notes, have been prepared, and those with the recognized authority have asserted that they have taken responsibility for those financial statements. The last important one is called as UDIN. UDIN is a 18-digit alphanumeric number. For this, I had an example called Prem Rajan and Associates, where Prem is a dropout CA, but he knows in and out. His father's signature he is using, but when he is introducing, he will say, "Hi, I am Prem from Prem Rajan and Associates." That means what? People will think that he is the partner. People will think that he is a chartered accountant. So, to curb the malpractices of non-CAs impersonating themselves as a CA, they got something called as unique document identification number. So on any document, say Prem's father is also signing, no problem. At least you know that your signature is being used here. So for any document, you go to the portal, you give details of the document, and then there will be a OTP which is sent to the phone of the member. Then that OTP will be given there, and then this UDIN will be generated. This UDIN has to be shown in the audit report. Is it given here? Yes. For him, separate UDIN. For him, separate UDIN. So for each signature that they are putting, there is going to be a unique document identification number. Is that clear, guys? Yes. With this, SA 700 and 701 comes to an end. 705, 706 shall we do tomorrow? 705, I'm going to start off with the mind mapping for 705. Please be with me. Here we're going to see the scope of the standard, objective of the standard, types of modified opinion, which type of opinion is appropriate. In case if you are not able to obtain sufficient appropriate audit evidence, what you have to do. Form and content of the audit report for modified opinion. That is, if it is a qualified opinion, what should be the text that you will be giving. If it is an adverse opinion, what should be the text and disclaimer of opinion. Basis for opinion, how should it be? 8 cases are there. Auditor's responsibility when the auditor disclaims. If there is a disclaimer of opinion, what should be there, what should not be there. And communication with TCWG. This is with regard to SA 705. The first one is scope. SA 705 is modifications to the opinion in the independent auditor's report. The keyword is you're modifying. When will you go for modifying? Whenever there is a material misstatement. Whenever there is a material misstatement, you will go for modifications. The scope of this standard is to deal with auditor's responsibility to issue an appropriate report in circumstances when informing an opinion in accordance with SA 700. Because when we were doing 700, we saw that what is the name of the standard? Forming an opinion and reporting on the financial statement. So SA 700 is talking about forming an opinion. So here a reference is given to SA 700 in the scope of SA 705. Because when you are forming an opinion only, you will be finding that a material misstatement exists or not. The auditor concludes that modification to the auditor's opinion is necessary. This essay also deals with how the form and context of the auditor's report is affected when the auditor expresses a modified opinion. The second part of the scope is basically talking about the form and content of the audit report, because here they are going to say what are the terminologies that you will be using. instead of the opinion heading, you will be writing adverse opinion in the heading itself. And inside, instead of saying gives a true and fair view, what are you going to write? Like that, it gives the form and context. That's why the scope is split into two. The first one is talking about auditor's responsibility with respect to giving an opinion as per SA 700. The second part is talking about the form and context. The second is the objective. The objective of the auditor is to express clearly and appropriately modified opinion, because here we are in SA 705. He has to give an appropriate modified opinion on the financial statements. That is necessary when there are two parts which is given here. The auditor concludes, based on audit evidence obtained, that there is sufficient appropriate audit evidence that the financial statements as a whole are not free from material misstatement. That means material misstatement are there. Not free from material misstatement means there is material misstatements which is present here. So the first part is talking about there is sufficient appropriate audit evidence and there is a material misstatement. The second part is talking about there is no sufficient appropriate audit evidence to conclude that the financial statements as a whole are free from material misstatement. I don't even have any kind of evidence with me for me to even comment on whether there is a misstatement present or not. So these two cases is the objective of the standard. Types of modified opinion. How many types are there? 3 types of them. What are they? Qualified, adverse and disclaimer of opinion. What is this qualified opinion? That there is sufficient appropriate audit evidence, that there is a material misstatement, but it is not pervasive in nature. What is the meaning of pervasive? Pervasive means it is affecting all the other items in the financial statements. For example, going concern is getting affected and they have prepared the financial statements as per cash basis of accounting. Now with this information, can you tell me, is it affecting just one item in the financial statements or is it affecting all the items in the financial? Sorry, they have not prepared as per cash basis, they have prepared as per accrual basis of accounting. So that means there is a misstatement which is affecting all the items in the financial statements. That is why it is pervasive. Pervasive means paravaradu. It is affecting all the items in financial statements. Quickly, let's see the definition of pervasive. It is a term used in the context of misstatement to describe the effects on the financial statements of the misstatements or the possible effects on the financial statements of misstatements, if there is any, that are undetected due to an inability to obtain sufficient appropriate audit evidence. In case if you don't have sufficient appropriate audit evidence also, it is undetected and there is a possible effect of this material misstatement being pervasive. So not only that there is sufficient appropriate audit evidence, you will say that it is pervasive. Even if there is no sufficient appropriate audit evidence, there is a possible effect on the financial statements of the misstatements for it to be pervasive. Pervasive effects on the financial statements are those that in the auditor's judgment are not confined to specific elements, specific account or specific item of the financial statement. They are not confined only to one area, but it is spreading to all the items in the financial statements. If so confined, represent or could represent a substantial proportion of the financial statements. For example, for a trading business, if closing stock is getting affected, then that becomes a substantial part of the business, and from closing stock the gross profit gets affected, from gross profit net profit gets affected, this net profit is getting carried forward to the balance sheet, so balance sheet is getting affected. So there is a pervasiveness of the effect of the closing stock, and in our case it is a trading business, so stock is extremely important, so it is material. If it is confined to one item, represents or could represent a substantial proportion of the financial statements, or in relation to disclosures are fundamental to users' understanding of the financial statements. Even if disclosure is not there, I can say that it is pervasive if it is fundamental to the users' understanding of financial statements. You understood what is the meaning of pervasiveness? Yes, qualified opinion. The auditor shall express a qualified opinion when the auditor, having obtained a sufficient appropriate audit evidence, concludes that misstatements which are individually or in aggregate are material but not pervasive to the financial statements. That is the thing which we saw here. The second one will come a little later. Adverse opinion. The auditor shall express adverse opinion, having obtained sufficient appropriate audit evidence, concludes that misstatements are there which is both material and pervasive. If it is ticker, then you will call that as adverse opinion. Disclaimer of opinion: unable to obtain the sufficient appropriate audit evidence, the auditor concludes that the possible effects on the financial statements of undetected misstatements could be both material and pervasive. If there is no sufficient appropriate audit evidence, you will say that. If it is pervasive, I will go for disclaimer of opinion. Adverse opinion: there is sufficient appropriate audit evidence that there is a material misstatement and also pervasive in nature. Qualified opinion: there is sufficient appropriate audit evidence, there is a material misstatement, but it is not pervasive in nature. Now coming to the second part. The auditor is unable to obtain the sufficient appropriate audit evidence on which to base the opinion, but the auditor concludes that the possible effects of the undetected misstatements could be material but not pervasive. So whenever it is not pervasive, it will always be a qualified opinion. See this table which is given here. Whenever it is no for pervasive, it is a qualified opinion. And whenever there is no sufficient appropriate audit evidence, it is either a qualified opinion or a disclaimer of opinion based on pervasiveness. Is that clear? If sufficient appropriate audit evidence is not there, it will be a qualified or disclaimer of opinion based on the pervasiveness. If it is ticker, that is, there is sufficient appropriate audit evidence that there is a material misstatement and it is also pervasive, then you will be giving a adverse opinion. Is that clear? Now, which type of opinion is appropriate? The decision regarding which type of modified opinion is appropriate depends on the nature of the matter giving rise to the modification, that is whether financial statements are materially misstated, the auditor's judgment about the pervasiveness. See, closing stock, always can I say it is pervasive? For a service business, is closing stock pervasive? No, first of all, it might not even be material in the first place. So there is a lot of auditor's judgment also which happens with regard to the pervasiveness. So which type of opinion, how are you going to find whether I have to give an unmodified or a qualified or a disclaimer of opinion? How you will be finding is by your judgment and also the nature of the matter. These two things are going to tell you what kind of opinion you are going to give. The next one is inability to obtain the sufficient appropriate audit evidence due to a management imposed limitation after the auditor has accepted the engagement. That means what are they saying? As an auditor, I have accepted the engagement, but now the management is imposing a limitation. In that case, what should the auditor do? You will first request the management to remove the limitation. If the management removes the limitation, then do we have any problem? No, we will proceed with the audit procedures. If the management says, hey, get out, I can't remove the limitation and all. If they refuse to remove the limitation, then communicate with TCWG and try to perform that alternative audit procedures. In that alternative audit procedures, also you are not able to obtain any kind of sufficient appropriate audit evidence, then see possible effects whether they are material but not pervasive. If they are material but not pervasive, nale, it is always a qualified opinion. If it is pervasive, possible effects are material and it is pervasive, you will be giving a disclaimer of opinion. But before giving a disclaimer of opinion, you see whether you are able to withdraw from the audit engagement. Is that clear? If the auditor withdraws from the audit engagement, before withdrawing, the auditor will communicate to TCWG, because here most of the cases the management is the problem. Just because you have management problem, if you go and complain to the TCWG, he will say, yes, he is a talavali for me also. I will push him outside of the organization. I will recruit a new manager who will be supportive for you. Like that, if they say, do we have any problem? No, we don't have a problem if they say that way. So when we tell the management to remove the limitation, if they remove, we'll go and do our audit procedure. If they don't remove, then we will first itself go and communicate with the those charged with governance, because Pavam, they are not involved in day-to-day affairs of the company, so they are required to know whatever is happening here. So communicate with TCWG and try to do the alternate audit procedures. If you are able to find any alternate audit procedures there, if you are able to find any evidence, then you can proceed with that. But here you are finding that there is a misstatement, but it is not pervasive. If it is not pervasive, we'll go for qualified opinion. If you feel that it is pervasive, then you will be saying that you will be giving a disclaimer of opinion. But before that, you will check whether you are able to withdraw from the audit engagement. In case you choose to withdraw again, you have to communicate with those charged. If the auditor withdraws, before withdrawing, the auditor should communicate to those charged with governance. Every time they say you have to communicate to those charged with governance, means you are giving another chance. Before going and using your weapon, they are giving another chance and telling them this is the reason why I have to withdraw. Are you able to rectify the problem? If they are able to rectify, I don't have any problem. But communication to TCWG is our duty here. Form and content of auditor's report when the audit report is modified. First of all, in qualified opinion, we saw an unmodified opinion in SA 700. What was the form and context of auditor's report? Last row, what was the form and context of auditor's report? In unmodified opinion, we saw two ways you can have the form and context. Yes or no? What are the two ways? Last row, girls and boys. What are the two ways? Form and context of audit report. That means how are you going to write the audit report if there is an unmodified opinion? You will be saying true and fair view, or you can also say it presents fairly. Yes or no? We saw that. What should not be there? Subject to, or with the foregoing explanation, these two words should not be there. We saw the form and context for unmodified opinion. Now we are going to see for modified opinion. If it is a qualified opinion, when the auditor expresses a qualified opinion due to material misstatement in the financial statements, the auditor shall state that in the auditor's opinion, except for the effects of the matters described in the basis for qualified opinion section, when reporting in accordance with fair presentation framework, the financial statements present fairly in all material respects in accordance with applicable financial reporting framework, or when reporting in accordance with compliance framework, the accompanying financial statements have been prepared in all material respects in accordance with the framework. When modification arises from an inability to obtain sufficient appropriate audit evidence, the auditor shall use the corresponding phrase except for the possible effects of the matters. So after they say yes, it presents a true and fair view of the accounts, then they are going to add something like except for the possible effects of the matter. Is that clear? This is for qualified opinion. Next is adverse opinion. Adverse opinion means what? There is a material misstatement and it is also pervasive in nature. So can we say that it is true and fair? No, we will be saying that it does not present fairly, or the accompanying financial statements have not been prepared in accordance with the applicable financial reporting framework. This is the terminology that we will be using for adverse opinion. For disclaimer of opinion, do we have any evidence? We don't have any evidence. When the auditor disclaims an opinion due to inability to obtain the sufficient appropriate audit evidence, he will state that auditor does not express an opinion on the accompanying financial statements. Basically, what am I saying? Disclaim means I am taking my hands off. I did not get any evidence. And according to me, this is pervasive in nature. So, I don't have anything to say because I did not get any evidence. The auditor does not express an opinion. State that because of the significance of the matters described in basis for disclaimer of opinion, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis for audit opinion. Amend the statement required by SA 700, which indicates that financial statements have been audited, to state that the auditor was engaged to audit the financial statements. These 3 points you have to keep in mind for disclaimer of opinion. Now going to the basis for opinion. The first thing which you have to notice is that basis for opinion paragraph heading is there, correct? That will have basis for adverse opinion. Basis for disclaimer of opinion. The heading will be amended first. Amend the heading basis for opinion required by SA 700 to basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion as appropriate. Within this section, include a description of the matter which is giving rise to the modification. Case 1. Quantitative disclosures. If there is a material misstatement of the financial statements that relates to specific amount, then you have to include that specific amount in the basis for opinion section and you have to quantify that amount. Not practicable to quantify. You are not able to say what is the amount and all. Going concern, how will you say what is the amount? You will not be able to quantify. In that case, you please mention in the basis for opinion paragraph that you are not practicable to quantify. Narrative disclosure. If there is material misstatement which relates to narrative disclosures, then auditor will include that also in the basis for opinion section and explanation of how the disclosures are misstated, because disclosure is supposed to be with regard to contingent liability. They have not put anything with regard to contingent liability, so I have to write it in detail that contingent liability I found out that was 1 lakh rupees, but they did not show that like that. I have to write it. Non-disclosure. If there is a material misstatement of the financial statement that relates to non-disclosure of information which is required to be disclosed, then auditor will first discuss with TCWG, describe it in the basis for opinion section. Unless prohibited by law or regulation, he will include the omitted disclosure which is provided it is practicable to do so and the auditor has obtained sufficient appropriate audit evidence with regard to the non-disclosure. Inability to obtain sufficient appropriate audit evidence. If I am modifying because I am not able to obtain the sufficient appropriate audit evidence, then give that reason in that basis for opinion paragraph. Disclaims an opinion. When auditor disclaims an opinion, their audit report shall not include the following elements. What and all will not be there if you go for disclaimer of opinion. That is very important. A reference to the section where auditor's responsibility are described. You will not give that reference to this section. A statement about whether audit evidence obtained is sufficient appropriate to provide a basis for audit opinion, because we do not have the evidence in the first place. So you give a statement saying this is not a basis to provide the audit opinion. Unless required by law or regulation, when the auditor disclaims an opinion, the auditor's report shall not include a CAM in accordance with 701. We saw in SA 701 also. Yes, whenever there is a disclaimer of opinion, CAM will not be there. Then what else? Auditor's responsibilities reference will not be there. And that I have obtained the sufficient appropriate audit evidence, like that you will start your paragraph, correct? That sentence that you have obtained will not be there, because the sole purpose of giving the disclaimer of opinion is because you did not get the sufficient appropriate audit evidence. Is that clear? 3 things will not be there if you go for disclaimer of opinion. If the auditor has expressed an adverse opinion or disclaimer of opinion, the auditor shall describe in the basis for opinion any reasons for any other matter of which the auditor is aware that would have required a modification. Now, if you are giving a adverse opinion or disclaimer of opinion, any other issue if it is there also you can put in the basis for opinion paragraph. Going back to the mind mapping so that quickly we can put the tick and come back. Did we see the scope? Objective, types of modified opinion, 3 were there. Which type of opinion is appropriate? How will you find that? Based on auditor's judgment and the nature of the transaction. Inability to obtain sufficient appropriate audit evidence. He is not allowing you. Management is imposing a limitation. Then what will you do? You will ask him to remove the limitation. If he removes, no problem, will be doing the audit procedures. If he says no, I will not remove, then communicate with TCWG, then see if it is pervasive and see if it is not pervasive. If it is pervasive, you will be giving a disclaimer of opinion. Now, inability, we saw form and content of the audit report. For unmodified, we saw that presents fairly in all material respects, or it gives a true and fair view. If it is qualified opinion, true and fair view, subject to these qualifications. Next, adverse opinion. they do not present fairly in all material aspects, or you will say they do not give a true and fair view of the state of affairs. Disclaimer of opinion, what will you say? Did not obtain the sufficient appropriate audit evidence. Basis for opinion, 8 cases we saw. What they are saying, whatever is there in the basis for opinion, you please quantify. If there is a narrative disclosure, you please give that narrative disclosure. Whatever is a reason, you please show that. If there is any other reason also, no problem, you put it in the basis for opinion paragraph. Auditor's responsibilities when the auditor disclaims communication with TCWG. These two are there, correct? Description of auditor's responsibility for audit of financial statement when the auditor disclaims an opinion on the financial statements. When auditor disclaims a statement that auditor's responsibility should not be there. A statement that, however, because of matters described in basis for disclaimer of opinion section, that should not be there. Statement about auditor's independence and ethical responsibility. These 3 points should not be there whenever he gives a disclaimer of opinion. Already we saw previously, disclaimer of opinion should not be there. Auditor's responsibility reference should not be there. I have obtained the sufficient appropriate audit evidence. That point should not be there. And CAM paragraph should not be there. There is only one case where CAM paragraph can be there whenever there is a disclaimer of opinion which is given. When law or regulation specifically says that CAM paragraph must be there. In that case, both is possible. Otherwise, it is not possible. Is that clear? Communication with those charged with governance. When the auditor expects to modify the opinion, whenever there is a modification, he will first communicate to TCWG what is the reason, the circumstances that led to the modification, and also the wording of the modification. How are you going to word it? Present fairly with all material respect, subject to, I am going to word it like this, sir. Like that you have to communicate it to those charged with governance. Is that clear, guys? That is SA 705. Going to 706, quickly let's go to the mind mapping. The scope, definition, objectives, EMP, separate section for EMP and some examples, important. Other matter paragraphs, separate section for OMP and communication with TCWG. I hope you guys would have already noticed that the keywords are given in red and whatever example is there is given in grey. Yes, and you would have seen in few places the text is given in dabba, text is given in box. That means in ICA also it was given in box. That means it is very, very important. Usually they will test from box. You can definitely expect 1 or 2 questions from box. Attempt on attempt I am seeing this. And for case study based question, they will take the case which is given in the example itself. Like how I told you for 570. There were so many examples which is given, and each of the examples can become a case study in itself. So all examples are important, guys. Now what is the scope of this 706? It is an additional communication apart from all the other things that they are doing with regard to the information either presented or disclosed or other than those presented or disclosed. If you see in the standard again and again, they are going to say the same thing. What is EMP? What is OMP? EMP is something which is already presented in the financial statements, and as an auditor we feel that this has to given more importance. Basically we are shedding light on that matter. Then you will be putting that in EMP. Now auditor feels that this is most important, but it is not presented in the financial statements. In that case, he will be showing that in OMP. That is other than those presented or disclosed in the financial statements, but which are relevant to users' understanding of the audit, the auditor's responsibility in the auditor's report. Definition. What is EMP? EMP is a paragraph included in the auditor's report that refers to a matter appropriately presented and disclosed in the financial statement. Already it is presented and disclosed, but in the auditor's judgment, he feels that it is important, that it is fundamental for the user's understanding of the financial statements. OMP is, this is also a paragraph which is included in the auditor's report that refers to a matter other than those presented or disclosed in the financial statement, that in the auditor's judgment that it is useful for the users of the financial statements. What are the objectives of SA 706? After forming an opinion on the financial statement, he is to draw the user's attention when in the judgment of the auditor it is necessary to do so by way of clear additional communication in the auditor's report. A matter, although appropriately presented or disclosed, that is of such importance for the fundamental to users' understanding, as appropriate any other matter that is relevant to users' understanding. That is the objective of the standard, whether it is already there in the financial statements or it is not there. For example, there was a fire which happened on 28th of March and most of the stock is destroyed. Now this fire which happened and most of the stock is destroyed on 28th of March itself, they have shown it in the books of accounts. So on 31st of March when they prepared the books of accounts, this is perfectly reflecting there. Now as an auditor, he feels that this has to be given more importance because entire stock is being destroyed. I cannot modify my opinion because I will go for modification only when there is a material misstatement. Is there any material misstatement? No, they have showed in the financial statements as per AFRF, whatever they have to show, they have showed. So I cannot modify, but still I want to throw light on this fire. So what will I do? I will go and put it in the emphasis of matter paragraph. For example, this fire happened and stock is destroyed, but they did not give that notes to their financial statements. In that case, I will be going to the other matter paragraph. Emphasis of matter paragraph. The auditor shall include an emphasis of matter paragraph in the auditor's report provided the auditor would not be required to modify the opinion in accordance with SA 705 as a result of the matter. And when SA 701 applies, the matter has not been determined to be a key audit matter. Say for example, the auditor feels that in public interest this has to be shown as key audit matter. Now you decided this has to be a key audit matter. Again, don't come and put it in emphasis of matter paragraph. Same way, you are modifying your opinion because going concern was not followed appropriately. Don't put that same going concern point in the emphasis of matter paragraph. Basically what they are saying is, if you decide that something has to be modified as per SA 705, or if you decide this is a key audit matter as per SA 701, don't bring that same matter in that EMP also. There should be a separate section for EMP. When the auditor includes an emphasis of matter paragraph in the auditor's report, the auditor shall include the paragraph with a separate heading that includes the term emphasis of matter. Include in that paragraph a clear reference to the matter being emphasized, and where relevant disclose all the matters which is relevant to whatever should be there in EMP, and indicate that auditor's opinion is not modified, because here they said if you decide to modify then don't come to EMP paragraph itself. So in the EMP paragraph, whatever issues that you are explaining, you please say based on this issue I have not given the modification. Is that clear? Some examples of circumstances, only I told you example is given, but it is given in blue. That means it is given in dabba. Here means in your ICA also it is given in dabba. So it is very important. Examples of circumstances where auditor may consider it necessary to include an emphasis of matter paragraph: and uncertainty relating to future outcome of exceptional litigation. Our Audi example. Future outcome we don't know, material uncertainty is there, they can come to EMP and they can show here. Significant subsequent event that occurs between the date of financial statements and the date of auditor's report. Date of financial statements in our example of SA 560, 31st June. Date of audit report in our example of SA 560, 21st June, 31st March to 21st June. Between this time, whatever happens in your audit report, you can put it in your emphasis of matter paragraph. Early application of a new accounting standard or a major catastrophe. Catastrophe means your earthquake, tsunami, all of those things. If that has happened, then if it has a significant effect on the financial position of the entity, you can show that as well. Now there are 4 examples which is discussed here. The first one is uncertainty relating to a future outcome. Second is significant subsequent event, but this subsequent event they are only talking in this time frame. What is that? Date of financial statements. 2. Date of audit report. Third is early application of new accounting standard. And fourth is a major catastrophe. The inclusion of EMP in auditor's report does not affect the auditor's opinion because EMP is not a substitute for SA 705 modification. It is not a substitute for disclosures in the financial statements. It is not a substitute for SA 570. Did we read these points somewhere else? Where did we see it? 701. It is not a substitute for. Four things we saw. CAM is not a substitute for. SA disclosures in the financial statements. SA 705 modifications. SA 570 going concern paragraph, or if a separate opinion has to be there, this is not a substitute for that. Same way for EMP also, 3 points they have given. All the three are same, only that separate opinion point is not there. 705 disclosure 570. Is that clear? Going to other matter paragraph, the auditor shall include an emphasis of matter paragraph in the auditor's report provided this is not prohibited by law or regulation. When SA 701 applies, the matter has not been determined by key audit matters. So for OMP also what they are saying, if something you have shown as key audit matter, don't again come here to OMP and show the same matter. Here again there is a separate section where with the heading other matters or other appropriate heading you can use. But if the auditor expects to include an EMP or OMP in the auditor's report, then definitely he has to communicate with TCWG. Everywhere we saw communication with TCWG is compulsory. Whether there is a modification, whether you are going to CAM paragraph, CAM and all, compulsory communication to TCWG, because any adverse consequence you cannot show in CAM paragraph. Same way for EMP, OMP also, communication with TCWG. A common point is there. Please make note. In the end here, common point for all 700 series. Unmodified opinion you don't have to communicate. 705, 706, 701. Common point is communication with TCWG. Is that clear? Shall we start off SA 299? Yes, in the mind mapping, we will be seeing what is the meaning, how the work is divided based on responsibility. If work is going to be responsible, if work is going to be divided, which auditor is responsible for what work, what is the advantages and disadvantages, joint or combined responsibility and special considerations regarding joint auditor. Basically, what is the meaning of joint audit, guys? Joint auditor is two or more auditors, or you can say as more than one auditor or an audit firm is coming and they are doing the work. So how will the work be divided between them? It can be divided based on assets or liabilities, income or expenditure, geographical location, identified units and period. That means if they say that work is divided based on assets or liabilities, I am saying Samira Reddy will take care of assets and Sushmita Sen will take care of liabilities. Income and expenditure, Samira will take care of income, Sushma will take care of expenditure. Geographical area, north, south. So Samira Reddy will take care of north, Sushmita Sen will take care of southern operations. Identified units, for this we took the example of Tata. Tata has so many segments like car segment, fashion segment, textile segment. This is only textile segment, FMCG. Like that they have multiple segments. So each of the unit will be taken care of, each of the auditors, that is divided based on units. Or one financial year, they will break it into half. Or they can break it into 4 parts. And they will say first part you take care, second part you take care. Like that they can split the work between different auditors. That is how work is divided based on these 5 things. Joint audit implies pooling together the resources and expertise of more than one firm of auditor. They are saying more than one firm of auditors to render an expert job. Usually it is prevalent in huge companies and corporations. Usually in bank audits, if you see, we saw the audit report, correct? 2 auditors would have signed. So usually for huge corporations or for bank audits and all, there will be multiple auditors who are going to sign the same audit report. Is that clear? Now, responsibilities of the joint auditor. Now, if two people are going to do the job, who is responsible for which work? We have to know. So, if the audit work is divided, individual or separate responsibility, say for example, profit and loss one person is taking care, balance sheet is one person is taking care, work is divided. So, separate responsibility for P&L will be there, separate responsibility for balance sheet will be there. But what about notes to accounts? It is not divided. So if the audit work is not divided, then both of them will be responsible for the notes to accounts, that is joint or combined responsibility. So responsibility of joint auditor, if audit work is divided, that work, that auditor, individual or separate responsibility. If audit work is not divided, then combinedly everyone will be responsible for that work. The next one, we are done with meaning, work divided based on and responsibilities. The next is advantages and disadvantages of joint auditor. For this example, 4 people we took. Investment advisory, Roshan, Naresh, Shiva, Hemanta. Only 4 people we took. Investment advisor only is Hemant. You don't know that also. Now, these 4 people, they are expert in their own fields. Roshan is expert in trust, Shiva was expert in stat audit, Naresh was expert in taxation, and this guy is expert in investment advisory. So 4 of them are expert in their own field, so they can share the expertise. That is the first advantage. If they have any issues between themselves, or if they have any confusion between themselves, they can mutually consult with each other and they can proceed forward. Advantage of mutual consultation. If one person itself has to do the entire job, then it will take lots of time and effort, because it is split into these 4. Then workload is reducing. Because they are focusing on their niche of work, the quality is increasing. Improved service to the client, this is also increasing. Work will be spread using the expertise of local firm, which are in a better position to deal with detailed work. Now, if I have to send one person to north also, south also, east also, west also, how much time, how much effort, how much cost will be there? Now, because north person is taking care of north operations, south person is taking care of south operations, my cost, overall cost, and my staff development cost comes down. Now, when one person has already finished the job, other person slowly they are going, they're calling and asking. Same way when you're studying also. One person, if they finished, other person now only opening the book. Now you call that person, Macha, you started, hey, I finished. Now how you will feel? You will feel that tension. That is the healthy competition, sense of healthy competition towards a better performance. All of these are advantages. Whenever there are advantages, there will definitely be disadvantages also. For this, what example we took? PwC and who? PwC and Naresh. Say for example, if these two are there in joint audit, there won't be communication between them. The superiority complex, I am bigger than you, mutual consultation cannot happen. So psychological problems will come. General superiority complex, problem for coordination of work. Now P&L one person take care, balance sheet one person take care, notes to accounts, who will take care? No, one person is going to say, hey, that is your job. Other person is going to say, I thought you are going to do it. Like that, they are going to fight between themselves. So common concern, whatever is there, that may be neglected. Uncertainty about the liability for the work done. Last point is, you said that cost reduces. One person can't go to different places. Yes, overall cost reduces. Yes, overall the staff cost also reduces, but at the same time the fees that we are going to get, that also is going to split into half. So fees has to be shared. That becomes a disadvantage. How many points in advantage? How many points in disadvantage? 9 in advantages, 6 in disadvantages. How many are there in advantages? 9. What are the points? Sharing of expertise, advantages of mutual consultation, lower workload, better quality, improved services for the client, lower cost, lower staff cost, lower overall cost, then finally there will be healthy competition. Only 8 points is coming. Oh, for MNCs, based on their expertise, work can be divided based on that. What are the disadvantages? 6 points are there. What is the first one? Fees is being shared. Psychological problems. Common concern gets neglected. Superiority complex is there. Coordination between work is difficult. And last, uncertainty about the liability. Now, for few works, they will have a joint or combined responsibility. What are the works for which they'll have the joint or combined responsibility? For any work which not being divided, they will have the joint or combined responsibility. If, one second, why it is coming like this? What is the reason for hiccups? Anyone knows? Someone thinking. Dr. Amaran told. Really, I am asking. Anyone knows why we are getting? No one knows. Stomach is settled. That is for babies. For kids, when they get the hiccups, they say they are growing. Now, what I'll do by growing more? Stomach is in good condition. Huh? They say it is good. One person will say, see, one person is saying someone is thinking about you. One person settlement of stomach. One person don't know. No one knows. What is the reason? What? I think that is the reason. I think that is the reason. I think body needs the oxygen. So, like that it will take. Come back, guys. Now, joint or combined responsibility, when will they have? The first one is if the work is not divided at all, then both of them will have joint or combined responsibility. For common audit areas, when they're splitting the work itself, you take care of P&L, you take care of balance sheet. Notes to accounts, both of us will take care. So commonly they are allocating the areas first itself. For that also, both of them will be responsible. If one person is bringing an issue and others have agreed for it, for example, everyone are saying it is a unmodified opinion, it is a clean report. One person has found out in one part that going concern is actually getting affected. Now he is coming with this matter and other people are looking at that matter and saying, yes, you are correct, going concern is getting affected. I am going to change my opinion to adverse opinion. Now everybody has changed their opinion to adverse. Now they have all accepted for it. That means everybody together they will be responsible. Matters brought by one and agreed by all. The next one is for the financial statements that it is prepared as per the AFRF. For the financial statements that it is as per the statute, that it is as per the law. Can you say this person is responsible for that? No. Everybody together, all the auditor and the audit firm together, they will be responsible for that. So financial statements as per law, financial statement as per AFRF. For that they will have joint or combined responsibility. Now audit report, how many reports they will be giving? They will be giving a single report. If they have common opinion, they will be giving only one report. For that one report, who is responsible? Everybody together they are responsible. So for audit report also they have combined responsibility. That audit report is as per all the ICAI pronouncements and other guidelines, they have combined responsibility. So joint or combined responsibilities, there are 5 points which is given here. The first one is for the work which is not divided. For all the common audit areas, they have joint or combined responsibility. If a matter is brought by one person and is agreed by all the other people, they have joint or combined responsibility. Financial statements as per law, financial statements as per applicable financial reporting framework, they have joint or combined responsibility. And lastly, for the audit report that they are giving, that the report is as per the ICAI pronouncement, they have joint or combined responsibilities. Now coming to the report. Now you all tell me, if they all have one opinion, then they will be giving how many reports? Single report. Now if they have multiple opinions and if 10 different auditors are there, how many reports will they be giving? They will be giving 4 reports and not 10 reports, because there are only 4 types of opinion: unmodified, qualified, adverse and disclaimer of opinion. There are only 4 different opinions, so 4 different kinds of maximum reports are possible. So if they have, it may be noted that joint auditors will be giving a common audit report. In case if there is a disagreement, then what will they do? They'll have separate audit reports. But whenever they're having a separate audit report, now you tell me, the users of the financial statements, when they see one report, they see that it is an unmodified report. But should he know that there are also other reports where adverse is there, qualified is there, disclaimer is there? For that, the reference has to be given in other matter paragraph as per SA 706. Is that clear? So if they all have a same opinion, then they'll be giving a common audit report and they will be signing together in that audit report. If they have any difference of opinion, then they'll get different audit reports. But in each of their audit reports, in other matter paragraphs as per SA 706, they must mention that there are also other opinions, there are also other reports. Please refer to that report. Like that, they have to mention in OMP. Is that clear? Now last part, special considerations regarding the joint auditor. Under that, few points are given. The first one is, see, whenever joint audit happens, whenever any kind of audit happens, the engagement partner will go for all the meetings. The engagement partner will plan everything and it will be communicated to the team members. But here in joint auditor, they are saying the engagement partner and the engagement team members must be involved in the planning process. From the beginning they have to be there, and they will be establishing an overall audit strategy for the entire team, and before the commencement itself the plan has to be made. The plan will be made when? Before the commencement of the joint audit, the plan has to be made. Now regarding joint audit, they will be identifying the risk of material misstatement even before they start the audit. Misstatement means mistake. Material misstatement means important mistake. Risk of material misstatement means there is a possibility of a mistake happening in a specific area. So if the risk of material misstatement is high, then they will do more audit procedures. They will increase their sample size and all of those things. So before they enter into the audit only, they will be seeing what is the risk of material misstatement. And finally, they have to document the nature, extent and timing for all the common problems and also for any specific issues if it is there. The engagement partner and other key members should be involved in planning the audit. The joint auditor should establish a overall audit strategy which sets the scope, timing and direction for the audit. Before commencement, they must have a joint plan. In developing a joint plan, the auditor should, important, these 5 points. Inside it is there possibility that ICAI can ask. Directly if they ask what are special considerations regarding joint auditor, everyone will study this and go. But if they are going to ask before the commencement, How are they going to develop the plan? Then you have to write these 5 points. Identify the division of audit areas and common areas. Ascertain the reporting objectives of the engagement. Consider the factors that are significant in directing the engagement team's efforts. Consider the results of preliminary engagement activity. Ascertain nature, extent and timing of the resources. These 5 points are written here. First one is division of audit and the common areas. Second, ascertaining the reporting objectives. Third, factors which is going to direct the engagement team's efforts. Fourth, what are the preliminary engagement activities? And last one is nature, extent and timing of resources. This is for which question? Before commencement, they are going to have a joint plan. How they are going to have the plan? They'll be identifying the audit areas, common areas. They'll be identifying the reporting objectives. They'll see what is the engagement team's efforts. Then they'll do the preliminary engagement activities. Now you understood from where this is coming. Now we are under special considerations regarding joint auditor. Under that, about 7 points are there. First one is engagement partner and engagement team member must be involved in planning. The second is they will have an overall audit strategy which is giving them the scope, timing and direction for the audit. Third point is they will have the joint plan, and before commencement the joint plan has to be there. For that only 5 points are there. The next one is risk of material misstatement which has to be communicated to all the other auditors. The next is documenting the nature, extent and timing of audit procedures, and finally there will be a common engagement letter and common management representation letter. Lastly, there will be something called as work allocation document where each of the partners or each of the auditors has to sign on that work allocation document so that I know that okay, you have accepted that duty. In case there is a problem in the future, I will exactly come and ask, why didn't you do your work properly? Like that I will be able to ask. This is SA 299, joint audit of financial statements. Easy guys. Very easy. Let's start off with SA 560, subsequent events. Quickly let's go through the mind mapping. The first one is, what is the subsequent event? What are the objectives? Meaning of date of FS is issued. Then events occurring between the date of the financial statement and the date of auditor's reports. Facts which become known to the auditor after the date of auditor's report but before the date the financial statements are issued. Facts which become known to the auditor after the financial statements have been issued. These three you pause it for some time. For now we will just finish this. What are subsequent events? Subsequent events you would have already studied in Accounting Standard 4. Subsequent events are those events that occurred between the date of the financial statements, that is nothing but 31st March, and the date of auditor's report. In our example, let me keep it as 21st of June. And the facts which become known to the auditor after the date of auditor's report. The financial statements will be affected by certain events that occur after the date of the financial statement. So 31st March, the financial statements are prepared and that financial statements is given to the auditor. Yes or no? Now the auditor has to sign the financial statements at a later date. In our example, it is 21st of June, saying that all the transactions happened till 31st of March is correct. Now based on this, it has to tell about the future of that entity. Now say something extremely material has happened after 31st March which is going to affect the going concern of the entity, and if the auditor is going to sign that, is that correct? Saying everything is correct, I am giving an unmodified opinion, it is wrong on the auditor. That is the reason why subsequent event is even there. The financial statements will be affected for the events which occur after the date of 31st March. Many financial reporting frameworks specifically refer to these two types of events. This is as per your AS4 only. There already you would have studied those that provide evidence of condition that existed at the date of financial statements, those that provide evidence of condition that arose after the date of financial statements. Say for example, there is a debtor. Debtor is of 5 lakhs and he has become insolvent after 31st March. Now, will we say that evidence of condition was existing or was not existing? Debtor was there as on 31st March. So there is always a possibility that he will become insolvency or evidence of condition was existing at the date of balance sheet. Now say for example stock is 2 lakhs. After 31st March what happened? Stock became 0 because of a fire. Was there any evidence of condition as on the 31st March? No, there was no evidence of condition as on 31st March because stock was there and fire there was no evidence as on 31st March. So we will say adjusting event and non-adjusting event. Adjusting event means if there is evidence of condition as on 31st March, you will adjust your financial statements. If there is no evidence of condition in our second example where there was a fire which happened after 31st March, then you will say that is non-adjusting event. So remember I told you 31st March you are saying stock is 20 lakhs and fire is happening on 30th of April. This is definitely a non-adjusting event. Now you tell me 31st March financial statements are there. On 29th of March there was a fire. There was a fire on 20th of March you keep. So this insurance claim will come only on 10th of April. So does this become an adjusting or non-adjusting event? This becomes an adjusting event because evidence of condition was existing as on 31st March. This actually is not as per standards on auditing. It is as per accounting standard 4. They have given few examples of events providing evidence that existed at the date of financial statements. Examples which arose after the date of financial statements: issue of a new share capital, merger of the company, destruction of inventory due to fire between the date of FS and date of audit report. Fire happened after 31st March. Then in that case it becomes a non-adjusting event because evidence of condition arose after the date of financial statements, that is after 31st March. Now only I am entering into SA 560, that is subsequent events. Under this we have 3 parts: events occurring between the date of financial statements and the date of auditor's report, facts which become known to the auditor after the date of auditor's report but before the date the financial statements are issued, facts which become known to the auditor after the financial statements are issued. Now again let me give you a timeline. 31st March the financial statements are completed and this will be given to the auditor. Say for example the financial statements are given to auditor, prepared and presented to the auditor as on 30th April. It is given to the auditor. Now the auditor will be giving his audit report again back to the management, and along with the audit report they will add other things and make that as annual report, and then only it will be given in the general meeting, annual general meeting. So this audit report, what is the date? 21st June. Now this audit report is given to the management and the AGM, that is the financial statements, are issued as on 30th July. On this date the financial statements are issued. Now there are 3 parts here. The first part is talking about events between date of financial statement and date of audit report. Now this audit report date, when I am putting the signature, I also have to consider all the events which occurred at this date. Now after I put the signature between the facts which become known to the auditor after the date of audit report but before the date the financial statements are issued, now I have put the signature. Here we saw events occurring, but here a fact which comes known to me at this period which has happened before itself, but not only I am knowing about this. That is why the terminology here used is facts which become known to the auditor after the date of audit report but before the financial statements are issued. Why is this period important? Because when the financial statements are issued, we don't have the power. The audit report is already given. So here what should I do? For the facts which become known to the auditor after the financial statements are issued. Is that clear? Now the most powerful is which period? The most powerful for the auditor is the first period, because the sign is still not done, audit report is still not prepared. So if something material happens, he can immediately take his weapon out and he can modify. So the first one is talking about 31st March to 21st of June. That is date of financial statement to date of auditor's report. Here auditor is still doing his audit procedures, yes or no? So the auditor will do the audit procedures for what? To obtain sufficient appropriate audit evidence. What are the audit procedures that he will be doing? He will understand of the procedures that the management has performed to identify the subsequent events. Why should management identify the subsequent events? Now, AS4 is talking about adjusting and non-adjusting event. So, AS4 is for the auditor or for the accountant? It is for the management who is basically preparing and presenting the accounts. So he has to know what is the subsequent event, whether it has to be an adjusting event, whether it has to be a non-adjusting event. He has to identify the subsequent event. So we as an auditor, we have to see what is the procedure that the management performed to identify that subsequent event. Now we have to go and ask the management, that is called as inquiry. You will take a mic with you and you will ask, unga toothpaste la uppu irukka. So inquiry will be done with the management and TCWG. Now if you ask any kind of information, are they going to respond to you? No, they will just say, get out of my office. In that case, you yourself will go and see the minutes of the meetings. That means, minutes means what? The meeting has happened and they will write whatever has happened in that meeting for a documentation purpose. You will go and read that minutes of the meeting. Now every company will make the budget for the next year. They will prepare the interim financial statements. Say for example, till 21st June, the first period is covering. 31st March to 21st June, how many months are there? 2.5 months are there till 21st June. So monthly financial statements they would have prepared. That is the interim financial statements or budgets. That also we will be seeing. So to identify whether subsequent event is identified by the management, whether they have given the proper effect of this subsequent events, we will have to see. Second, you will go and directly ask them, inquiry with management and TCWG. Third, if they don't give any information, we ourselves will go and see the minutes of the meetings with the management and TCWG. And finally, we will see the budgets or the interim financial statements. Now I told you, you will simply go and ask the management and TCWG. Means there is a possibility that they will not give any information. Specifically, you have to make the inquiry. For that specific inquiry, we have a mnemonic called AAA BCD. What is this AAA BCD? A stands for how are all the accounting policies, whether you are following them consistently, if there is any change, whether you have done the adequate disclosure. Second, any kind of accounting adjustments. Have you done any adjustments in your accounts? Please show that to me. I want to see whether it is done appropriately. Another is acquisition of assets. Have you acquired a major asset after 31st March or have you sold a major asset after 31st March? Because here I am signing saying that asset is with you. You have the title of that asset. So I need to know whether you have sold or acquired an asset. That is AAA. What is B? Borrowings or any new commitment, because here I am signing that your borrowings is only 10 lakhs. Have you taken 1 crore of borrowings after 31st of March? Then my sign will become wrong. So I will ask a specific inquiry as to what is the borrowing that you have, if any, after the 31st March period. What is C? Contingencies. Any contingent liability, is it there for you? Have you made the adequate disclosure? And finally, whether government has destroyed or appropriated an asset. Have you seen in movies, government will come with huge bulldozers and they will just destroy the property. So something like that, has it happened? If it has happened, I definitely have to mention in my audit report that it has happened after 31st month. So when you are doing the inquiry, don't simply go and ask unga toothpaste la irukka. Please ask the AAA BCD for you to understand what is the subsequent event and how it is having an effect on the financial statements. This is the first part. And finally, you will be getting SA 580. What is that? Written representation from the management that they have identified a subsequent event, and if they have identified whether it is adjusting, whether it is non-adjusting, whether they have shown that in the financial statements appropriately. You will have to ask that to the management. Yes, let's quickly finish the first part. Events occurring between the date of financial statements and the date of audit report. The audit procedures relating to events occurring between the date of financial statement and the date of auditor's report. Auditor will perform the audit procedures designed to obtain sufficient appropriate audit evidence that all the events occurring between the date of financial statement and the date of audit report which require the adjustment or which require disclosure, first of all, whether they have been identified. Obtain an understanding of the procedure that management has established to identify the subsequent event. Inquiry with management and TCWG as to whether any subsequent events have occurred which is affecting the financial statements. Reading the minutes of the meetings, reading the entity's latest interim financial statements, and also read the budgets. These 4 points you have to remember. And finally, the auditor will also request the management to provide a written representation, SA 580, that all the events occurring subsequent to the date of financial statements and for which the applicable financial reporting framework requires adjustments or disclosures have been adjusted or disclosed. Now, what is that inquiry which you have to do with the management and TCWG? AAA BCD. A is accounting adjustments. Any unusual accounting adjustments is there. Another A is accounting policies, whether it is appropriately used. Another A is acquisition of assets or sale of assets. B, any new commitment of borrowings or guarantees which has been given. C is any contingencies or contingent liability which arised later. Or D is asset whether it has been destroyed by the government. Is it easy, difficult, hard? Very easy. Now the second part is talking about facts which become known to the auditor after the date of auditor's report, but before the date the financial statements are issued. Now you have to know what is the meaning of date the financial statements are issued. It reflects the date that the audit report and audited FS are made available to the third parties. It is not only the shareholders but all the stakeholders of that company will receive this audit report. The date the financial statements are issued generally depends on the regulatory environment of the entity. In some circumstances, the date the financial statements are issued may be the date that they are filing with the regulatory authority also, because not necessary that they have to always issue the financial statements to the public. Sometimes they will just have to give it to the regulatory authority. Since audited financial statements cannot be issued without an audit report, the date that audited financial statements are issued must not only be at or later than the date of audit report. So that's why I started with the flow. What did we see as the flow? Date of audit report is 21st June. Financial statements are issued. I told you the audit report will be given to the management. They will add other things and they will make that as annual report, and that annual report will be issued to the stakeholders in the general meeting. Now, can I say that the date of this audit report is after the financial statements are issued? It is not possible like that. That is the reason why they have given that sentence. They are saying the date that audited financial statements will not only be at or later than the date of auditor's report, but must also be at or later than date of audit report which is provided to the entity. Yes, first audit report is prepared, then it is given to the entity, and then only it is issued to the shareholders. Facts which become known to the auditor after the date of audit report but before the financial statements are issued. Now you tell me, you have put your signature and you have given that audit report, the date of audit report is done. But after you put your signature, you are finding out some part where if you have seen that previously, your opinion would have been changed. But that fact of that is coming to you only now after you have put the signature. In that case, should you again do all the audit procedures? Should you again get all the audit evidences? The auditor actually does not have any kind of obligation to perform the audit procedures after the date the audit report is given. So first you will have to discuss with the management. Why, sir? Why did this get missed? Why did not give me this information beforehand itself? Like that, you discuss with the management. See if the financial statements actually require the amendments. If something is really material, then you can educate them saying, no, sir, what we have done is wrong. You please change the financial statements. Now, is he going to change? In 99.99% he will say, now you'll ask me to change, again you'll sign one audit report and give me, again you'll come and ask me to change, you think I'm your servant or what? Like that he will ask. So normally he will not change. But that 0.1%, if he is a good person, like this princess, if he says, okay sir, I accept, if he is like that, then he will say okay for changing. So first you have to discuss with him and see whether the financial statement requires any kind of amendment. If the management says, okay, I will amend, then in that case, you will be doing the audit procedures and you will get the audit evidence. Now, in the case where management does not amend, management says, get out of my office, I cannot amend. Now you see, date of audit report you have signed and you have kept it here only, in the table only it is there. It's still not sent. Audit report is still with you. It is not provided. In that case, the weapon is still with you. Then you will go for SA 705 modification. If the audit report is provided, but it is given only to the management, they still have not issued. They still have not given. So, audit report is provided. You will ask them not to issue. Will they listen to you? If they issue without any amendments, then the auditor has to prevent the reliability. The onus is on the auditor. You do something, but you prevent the reliability. What you will do? You call the press. You call Sun TV, Vijay TV, Jaya TV. You call all those people and you give a press conference. Or you put the status. Or you put the Instagram story, you put a LinkedIn post, you do something, it is up to you. Standard is not commenting on that. But the auditor has to prevent the reliability if the management has issued without amendments. Is that clear? This is if management does not amend. Now the second part is facts which become known to the auditor after the date of audit report but before the date the financial statements are issued. They have no obligation to perform any audit procedure, so you will be discussing with the management, determine whether financial statement need amendments and inquire how they are going to address. Before the date the financial statements are issued, the management amends, then what will you do? After the date the financial statements are issued, this is the third case. We'll go to that a little later. Before the date the financial statements are issued, if the management amends the financial statements, then you will be doing your audit procedures, you will obtain your sufficient appropriate audit evidence and you will be giving the conclusion. If the management does not amend, you see who has the audit report. Audit report is still with you, then that means weapon is still with you. Modify the opinion as per SA 705. Audit report is provided to the management. In that case, you ask them not to issue it to the third parties. Nevertheless, subsequently it is issued without the amendments, then the auditor will take the appropriate actions to prevent the reliability on that report. The onus is on the auditor only. What is the third case? Third case is facts which become known to the auditor after the financial statements are issued. In our case, what is the date which we saw? 30th of July. Is that correct? Oh, very good. On 30th of, after 30th of July, if they come to know of anything, provided if he knew this before, he would have given a different opinion. Then in that case, does the auditor have any obligation? No. After the financial statement, after the audit report is given itself, he has no obligation to do the audit procedures. This is after the financial statements are issued. Here also, he has no obligation to do any audit procedures, but again he has to discuss with the management and TCWG, see if they are going to amend the financial statements, and once the management amends the financial statement, that 0.1%, in case the management amends the financial statements, now they are going to have two audit reports, yes or no? In the amended financial statements, all the audit procedures will be done, all the audit evidences will be obtained, and a new audit report will be given. In this case, you have to inform to the already issued users that something like this is there. So how will you do that? In this new audit report, you will give a reference to that previous audit report. In that EMP or OMP as per SA 706, you will be giving a reference so that the person who is reading this report knows that this is not the only report, there is something else, and that should be mentioned in EMP or OMP. The remaining 99.99% of the people, after the financial statements are issued, if the auditor goes and says, sir, this needs amendment, what are they going to say? Get out. They will say, no, I cannot amend. So management does not amend. In this case, the auditor has to prevent the reliance. The standard is not saying how you are going to do this, but auditor has to either give a press conference, press meet, LinkedIn, a selfie, story, whatever you want you do. But you have to prevent the reliance of that previous audit report which is signed by you. Is that clear, guys? Now going to the text of the facts known to the auditor after the financial statements have been issued. After the financial statements are issued, auditor, does he have any obligation to perform the audit procedures? No, he has no obligation to perform any audit procedures. So he'll discuss the matter, determine whether financial statement need amendments, and inquire how the management intends to do this. If the management amends the financial statements, now in the new financial statements, you will be doing all your audit procedures. Inform to already existing users. Obtain the amended financial statement, give the new audit report. But in the new audit report, you have to mention in the EMP and OMP as per SA 706. If the management says, get out, I will not amend, then you will take appropriate action to prevent the reliance on the audit report. Is that clear, guys? This is SA 560 revision. Starting off with SA 570 going concern. Now, how many points are there for the mind mapping for going concern? 13 are there. Starting off with meaning of going concern, significance of going concern, what this standard deals with, what is the objective of the standard, responsibility for assessment of entity's ability to continue as going concern, responsibility of the auditor, risk assessment procedures and related activities, examples of events or conditions that may cast a significant doubt on going concern, evaluating management's assessment, additional audit procedures, are there any examples of the audit procedures, auditor's conclusion, how he has to conclude and how he has to disclose, adequacy of the disclosure, if there is a material uncertainty, if there is no material uncertainty, and finally we will be going to implications, that is 3 cases which is given here. Starting off with meaning of going concern. What is the meaning of going concern? Going concern means that the company is going to go on for ever and ever and ever. Like how when boyfriend, girlfriend come together, you all would have done that to your boyfriend. What you will tell? Whatever happens, கடவுளே வந்து சொன்னாலும் I will definitely marry you only. You would have told that at least to one person in your life. Yes or no? Then what happened? Then what happened? What happened? Usually people will be making all these promises that they will be together. Love you forever, like that you will put this symbol. That means what? Infinite. Forever and ever you are saying. But in reality, what will happen, only you know. I am not commenting on all those things. Like that, when you are preparing the books of accounts, when the management, Rudra is like, ma'am, you have taken the inner trauma out of my heart. Why, ma'am, you are reminding me all these things in audit class. How can we concentrate? Now, the same way the company also says that they are going on for ever and ever and ever. They don't have any intention to liquidate. They don't have intention to cease the operations. You would have studied GCA, fundamental accounting assumption. What are they? Going concern, consistency and accrual. This is one of the most fundamental accounting assumption. The meaning of going concern is one of the fundamental accounting assumptions. Enterprise is normally viewed as a going concern, that is as continuing in operation for the foreseeable future. Whatever future I can see, I know that I am going to go on forever. Under going concern basis of accounting, financial statements are prepared on the assumption that entity is going concern and will continue its operations for foreseeable future. General purpose financial statements are prepared using going concern basis of accounting unless management intends to liquidate the entity or cease the operation or has no realistic alternative. Now, if they have an intention to liquidate, why not going concern? Then what basis of accounting will they follow? They will follow cash basis of accounting at that case. Now the second point is talking about significance or importance or the impact of the going concern. Now you all tell me, what is the significance or the impact of going concern? Who will see the going concern and why should they see the going concern? Who will see the going concern? That was my first question. The management is supposed to see the going concern because the management is the one who is preparing and presenting the financial statement. As an auditor, why is it important? What is the impact of seeing the going concern? Because it has a direct effect on the financial statements. Because if you prepare your financial statements as per going concern, you have to prepare a certain way. If you don't prepare as per going concern, then you have to prepare in cash basis of accounting. So all your values is going to change. So it has a direct effect on the financial statements. Now, if the going concern is used appropriately, if your going concern is used appropriately means it is properly used, then you will discharge your assets and you will realize your assets and you will discharge your liabilities accordingly. If going concern is not proper, then definitely you will have to go for cash basis, that is liquidation basis of accounting. Is that clear, guys? Significance of going concern is because of the effect on the preparation of financial statements. It has a direct effect on the FS. Ability or otherwise to be viewed as going concern affects its preparation of financial statements. When it is appropriate, assets and liabilities are recorded on the basis that entity will be able to realize its assets and discharge its liabilities. When enterprise is not viewed as going concern, then it is prepared as per liquidation basis. Liquidation basis means cash basis. Cash basis means, I'll tell you what, say there is a machinery. The machinery is valued at 10 lakhs. Then you'll put depreciation. It comes to 9,50,000. Again depreciation. It comes to 9,20,000. Like that it keeps on reducing. Is that the real value of the machinery? No, it is the book value of the machinery. If you actually have to go and sell that machinery, what will you get in return? Maybe 2 or 3 lakhs. So once you know that going concern is getting affected, automatically the value of that machinery comes down to 2 or 3 lakhs. Is that clear? Otherwise it will be at cost price minus depreciation, the carrying value of the machinery, or carrying that value for your books. That is the book value. Yes or no? So you will carry that, but once you know that it is going for liquidation basis, you will go off for cash basis of accounting. That is the significance of going concern. This standard deals with auditor's responsibility. As an auditor, what and all we have to see. And finally, the implications. The implications is nothing but the cases I told you, the last part. So what is the auditor's responsibility? All of this is the auditor's responsibility. Going forward, what is the objective of the auditor? What is the objective of the auditor means what? Now there are two things that you have to see here. There is objective of the auditor and there is responsibility of the auditor. What is the meaning of objective? What is the meaning of responsibility? What is the meaning of objective? What is the meaning of responsibility? If I ask you what is your objective, it will be to finish CA Inter by whatever year. Now, if I ask you what is your responsibility to finish off studying whatever happens in class every day. Whenever we see the workout, you have to write and practice and not just see. Like that, you have few responsibilities. You have to wake up in the morning and you have to come to class on time so that you won't even miss even a single word. That is your responsibility to achieve the objective. Yes or no? Same way here, two things are given, objectives and responsibility of the auditor. The objective of the auditor is that final conclusion where he wants to reach. The responsibility is to reach that. What is he going to do now? Is that clear? So, objective of the auditor, there are three objectives here. First is, who is responsible for that going concern you told me? The management is responsible. As an auditor, we have to see whether this management has appropriately used the going concern basis of accounting. Appropriately used means what? If the company is really going concern, they have to use accrual basis of accounting. If the company is not going concern, they have to use liquidation basis of accounting. So whether the management has appropriately used the going concern basis, we have to see by obtaining sufficient appropriate audit evidence for that. That is the first objective of the auditor. Now, with whatever audit evidence that he has, he will have to conclude whether material uncertainty exists or not. What is the meaning of material uncertainty? It is a 50-50 probability that it can happen or might not happen. Like how you will be like after writing the exam. Did you do well? What you will say? You will not say you did well also. You will not say you will definitely not did well also. But you will be like, okay. You ask everyone, anyone who has written the inter exam, and when they come out, you ask them how you did. Single person also will not tell. Yes, ma'am, I did very well. I will definitely clear. Very rarely I will see those people, and those are the people who will clear. They will definitely clear. You should have that feeling that you will clear even before you go for the exam. Even before you go for the exam. Is that feeling possible? Yes, in your board exam, did you have that feeling? Yes. If it was possible that time, if it is possible now also. Before you go for exam, however they want, let them ask in the question paper. I don't care. I am prepared to answer. Your preparation level should be in that extent. If you see most of the times, they don't ask out of syllabus question and all. 95% in syllabus only. They don't ask out of syllabus question. In syllabus only. But they will twist and turn the concepts and ask. If you have utmost conceptual clarity, there is no way you will feel like paper is difficult. There is no way you will feel like there is a maybe. You should have that level of confidence before you go to the exam. After finishing the exam, if someone asks how you did, samaya panna, like that if you tell what other சொல்றதுக்கே முடியல. Like that if you tell how other person will react, they will get scared. Yes or no? Samaya panniya. எது? They will ask like that. Yes or no? But you should have that feeling. Trust me, it is a good feeling to have. And if you put in that effort now, definitely you will have that feeling. But that effort is required from now, from this second, from this moment. Not even from tomorrow. From now, that effort is required. Now, material uncertainty means there is a 50-50 probability. Say for example, there is a lawsuit which is pending on the company. If a lawsuit is pending on the company, we don't know how the judge is going to give his verdict. So if he says for the company, then we will save the money. If he says against the company, my going concern itself might get affected. I have to pay crores and crores of penalty here. So there is a 50-50 probability that the judge will give for or against the company. That is called as material uncertainty. As an auditor, our objective is to see whether there is any material uncertainty or not. And finally, in essay 700, contents of audit report, you would have seen one of the points as going concern. Yes or no? paragraph for going concern separately must be there, that reporting as per SA 570. This is also one of the objective for the auditor. There are three objectives for auditor. What are the three? Obtain sufficient appropriate audit evidence that the management has appropriately used the assumption of going concern. Second is whether material uncertainty exists or not. And third is reporting as per SA 570. Now see these: obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management's use of going concern basis. To conclude based on audit evidence obtained whether material uncertainty exists relating to events or conditions that may cast a significant doubt on entity's ability to continue as going concern. To report in accordance with this standard. Is that clear? That is the objectives of the auditor. What is the responsibility of the auditor? What is the responsibility of the auditor? The responsibility of the auditor is again to obtain sufficient appropriate audit evidence to see whether material uncertainty is there or not. Now, responsibility applies even if financial reporting framework doesn't require the auditor to do something, because character, an auditor must have that character that even if it is not responsible as per the AFRF, he has to do it. There are few things like that. You have the character. If you find money on the floor now, 5 lakh rupees, something you found on the floor, what you will do? You will put in your pocket and go? You will donate it. You will go to the police station and you will give it. That is, the responsibility applies even if there is no rule for you to do so. So responsibility applies even if financial reporting framework does not require to do certain things. That only is for going concern also. The auditor's responsibility applies even if financial reporting framework doesn't require him to do anything. Going concern is for what? Is for the next 12-month period, correct? Next 12 months, what will happen? How we know now? So the future are always uncertain. Future events are always uncertain. And this going concern, say for example, the auditor has said that going concern everything is fine. Now, does that mean that in the future everything will be fine? No. You go to the doctor, doctor says you're completely fine, you don't need anything, you're going back home. Can you say that nothing will come to your body for the next 1 year? No. Maybe today you are saying all these things, tomorrow itself I can catch an infection. So same way, the absence of going concern warning is not a guarantee. Now see the text. The responsibility of the auditor to obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management's use of going concern basis of accounting and in preparation of financial statements. These responsibilities exist even if the financial reporting framework does not include an explicit requirement. This is a responsibility. Whether or not it is a rule, as an auditor, you have to do all of these things. However, as described in SA 200, the potential effects of inherent limitation on auditors' ability to detect material misstatement are greater for future event and conditions. So, the auditor is not in a position to predict such future event or conditions. Accordingly, the absence or any reference to material uncertainty cannot be viewed as a guarantee as to entity's ability to continue as going concern. So if they ask the responsibility, only the first point is talking about the actual responsibility. The 2, 3, 4, 5 are the disclaimers for that responsibility. If you see, what is the first point? They are saying that the responsibility of auditor is to obtain the sufficient appropriate audit evidence that the management has used the going concern principle appropriately. That is the responsibility. 2, 3, 4, 5 is disclaimer for that responsibility. They are saying, I will give the responsibility, but even if it is not as per the rule, I will definitely give the responsibility. Third point, what is it saying? There are inherent limitations. I am giving the responsibility for the future. So something might happen, might not happen. It is only in God's hands. Like that, they are giving a disclaimer. What is the fourth point saying? Based on all of this, it is difficult for the auditor to predict what will happen in the future. And in the end, it is not a guarantee that this company is going to go on forever. So all these 4 points are disclaimer to that first point. So if they ask the responsibility for the auditor, first point you have to write it as first point. Is that clear? There won't be any meaning if you are going to write absence of reference to material uncertainty is not a guarantee for entity's ability to continue as going concern. If you start the answer with that, it doesn't convey the same meaning. Yes or no? You have to start with auditor's responsibility is to see the appropriateness of the management's use of going concern. How did you understand? Yes, these are the 5 points for responsibility of the auditor. Examples of events or conditions that may cast a significant doubt on the going concern. There are 3 topics here: financial event or condition, operating event or condition, other event or condition. What is that financial event or condition? I've already told you these 3 are very, very important because it is example. They can ask a separate case study for each of these examples. I'll tell you how. They will say there were creditors for, what's your name? Malini, Hema Malini Limited. There are creditors. Now what happens suddenly? Those creditors are withdrawing their support. Now as an auditor, tell what is your responsibility. Now withdrawal of support from creditor, you need to know that they are talking about going concern because it is one of the financial event or condition. If you see here, indication of withdrawal or financial support by the creditor. With that case study, you need to first connect here and then they are asking the responsibility of the auditor. Are you understanding? They will not directly give going concern. They will give a case study based question using these indicators. Are you able to understand, guys? Now what are the financial events or conditions? Net liability or net current liability position. With this, can they make a question? This numerical question also possible. They will say the assets is 1 crore. The liabilities is 2 crores. What is the objective? Nowhere they have mentioned it is going concern. You have to see assets 1 crore, liability 2 crores. Now that means it is a net liability position. That means they are talking about going concern. Like that you have to connect the dots and come to this standard. Is that clear, guys? Net liability or net current liability position. Fixed term borrowing approaching the maturity without realistic prospects of renewal or repayment. Withdrawal of support by creditors. Negative operating cash flow. Adverse financial ratios, substantial operating losses, arrears or discontinuance of dividends. They can even make a question like this. Last year, dividend was paid for 1 crore. This year, no dividend is paid. Then you have to know that they have not paid the dividend right now. Next year, again, they are saying that they will pay the dividend, but they do not pay. So arrears of dividend is keep on accumulating or discontinuance of dividend. Inability to pay the creditor on due date. Inability to comply with loan agreement. Change from credit to cash on delivery transactions with suppliers. Inability to obtain financing for essential new product development. You are not able to obtain the money. Support from creditors is not there. I am not able to repay the loan. Financial ratios, if you see, it is very adverse. All of these are financial conditions for affecting the going concern. Is that clear? Ignore those lines. Operating events or conditions. Management intention to liquidate or to cease the operations. Loss of key management without the replacement. Loss of major market, loss of key customer, loss of franchisee, loss of license or loss of suppliers. Labor difficulty, shortage of supply, emergence of highly successful competitor. Now material is not there, labor is not there, customer is not there, market is not there. If you've lost any of this, then you will come to going concern. Other events or conditions. Non-compliance with statutory or regulatory requirements such as solvency or liquidity requirements. Pending legal or regulatory proceedings against the entity that may, if successful, result in claims that entity is unlikely to be able to satisfy. Changes in law, regulation or government policy expected to adversely affect the entity. Uninsured or underinsured catastrophes when they occur. All of these are other events or conditions. Evaluating management's assessment. The auditor's job is to evaluate the assessment of the management with relating to going concern. At that time, it is not the auditor's responsibility to rectify the lack of analysis. In some circumstances, however, lack of detailed analysis by management to support its assessment may not prevent the auditor from concluding whether it is appropriate in the circumstances. So, the management has to see, the auditor will be checking whether it is appropriate for the management to use the going concern assumption or not. What are these additional audit procedures? If there is an event or there is a condition which is going to tell you that there is a significant doubt in the entity's ability to continue as going concern, that means any of these scenarios have triggered the financial indicators or operating indicators or other events or conditions, they have triggered for going concern, then we as auditor, we have to obtain sufficient appropriate audit evidence to see whether material uncertainty is there or not. For that, we will be doing the additional audit procedures. Is that clear? Yes. Under those additional audit procedures, what are the points which is there? We will request the management to first make the assessment of going concern. You yourself see, sir, whether this company will go on forever. You make the assessment whether this company is having that going concern. Now the company is going to say, yes, sir, even though there is operating losses right now, I understand you are thinking this is an indicator for me to continue as going concern, but for this loss to get covered, I have a loan. That loan is already sanctioned, like that they are showing a plan. So as an auditor, we have to see whether that plan is feasible or not. That is the second point. What was the first one? We will require the management to do the assessment for the entity's ability to continue as going concern. Second, if they tell you the plan, we will be seeing whether the plans are feasible or not. Now you are saying, okay, you will get the loan. Based on this loan, what are you going to do? How will you improve your sales? Now they will say, now with this loan, I will spend for marketing. If I spend for marketing 10 lakh rupees, my sales will increase 10 times. That is the assumption that the management has made. Now, on what basis the management has done the assessment, we have to see as an auditor. Reliability of underlying data which is going to support the assumption. That is the third point. Fourth is if there are any additional facts which has to be taken. And finally, if auditor is not convinced and management is saying, yes sir, going concern is there, you please give it to me in writing. That is called as written representation. That is the last point, written representation. Now read all the 5 points which is given here. First one is requesting the management to make the assessment. Second, management will be giving the plans and auditor will be seeing whether the plans are feasible in the circumstances. Third is what? What are the assumptions on which you made the plan? Whether entity has prepared a cash flow forecast, analysis of the forecast, reliability of underlying data to prepare the forecast, determine whether adequate support for assumptions underlying the forecast. Fourth is what? Any additional facts or information, is it available? And finally, you will ask for written representation. Examples of audit procedures. Now, to do all of these audit procedures, what are the audit procedures that you will be doing? Now, for this only you guys made that CM. Okay. Lokesh Kanagaraj will come, correct? MSD, LCU, MSD, LCU and Bird. Yes. What is that M? Minutes of the meeting of shareholder TCWG. What is S? Subsequent events. D. Debentures and loan agreements. L. Legal requirements. C. Cash flow and cash flow, profit and other relevant forecasts. U. Unfilled customer orders. B. Borrowing facility. I. What is I? Interim financial statements. R. Regulatory actions. D. Disposal of assets. That is MSD, LCU, Bird. Examples of audit procedures. All of you together. What is M? Minutes of the meeting. S. Subsequent events. D. Debentures. L. Legal requirements. C. Cash flow, profit and other relevant forecasts. U. Unfulfilled customer orders. B. I. Interim financial statements. R. Regulatory action. D. Disposal of asset. Everybody together, what is M? Minutes of the meeting. S. Subsequent events. D. Debentures. L. Legal requirements. C. Cash flow forecast profit. U. Unfulfilled customer orders. B. I. R. Regulatory action. And finally D. Disposal of asset. This is examples of audit procedures. As additional audit procedures, these are the examples. Again, if it is given in dabba, that means it is very, very important. What is the auditor's conclusions talking about? The conclusions is basically relating to the objectives. What was the objectives? There were how many objectives that we saw? What are the objectives? To obtain sufficient appropriate audit evidence with regard to management's use of going concern. What was the second objective? To see if there is any material uncertainty whether it exists or not. And third objective was to report as per this essay. Yes or no? That objective for you was what? To finish CA Inter by this attempt. Yes or no? Same way, the objective is the conclusion in itself. So, auditor's conclusion is also going to talk about the objectives. That is, the auditor will evaluate whether sufficient appropriate audit evidence has been obtained regarding and shall conclude on the appropriateness of management's use of going concern basis of accounting. Isn't it the same? Based on audit evidence obtained, auditor shall conclude whether there is material uncertainty exists. Isn't this the same? Material uncertainty exists when magnitude of its potential impact and likelihood of occurrence is that in the auditor's judgment appropriate disclosure of the nature and implication of uncertainty is necessary. They are talking about the first 2 points. Is that clear, guys? If you have not written previously, please write now auditor's conclusions connected with objectives of the auditor. Next is the adequacy of the disclosure. That means if there is a material uncertainty, then what should you do as the auditor? The going concern is there, but there is a material uncertainty. Then what will you do? Going concern is there, but material uncertainty is there. You are not able to think of the example. Yes, material uncertainty is there. Going concern is also there. This is very irritating. Going concern is there and material uncertainty is there. Car is perfectly fine, but some light is blinking over there. How you will feel? It is perfectly fine. Engine is fine. Everything is fine, but some light is blinking over there. Then how you will feel? You know you will definitely go because you've tested the engine, but still you are a little scared because of that light. Yes or no? That is that material uncertainty is there, even though going concern is there. The company will go on forever, but there is some kind of a material uncertainty. For example, loan is falling due. It is not even come due. Due date has not even come. Loan is falling due. Only if due date has come and if the company is unable to pay, you will say going concern is getting affected. Now only it is falling due. So going concern is there and refinancing the company wants to go and that is not confirmed. If refinancing is not confirmed, we don't know what will happen in the future. 50-50 probability, material uncertainty will get affected. Is that clear? But loan has not even fallen due. We are not a defaulter yet. Going to fall due. So going concern, no problem. But there is a material uncertainty. In this case, what should we do? The auditor has to disclose the uncertainty and whatever the management is planning, that also the auditor has to disclose. If the auditor concludes that management's use of going concern basis of accounting is appropriate in the circumstances, but material uncertainty exists, then the auditor will determine adequately disclose principal event or condition that may cast a significant doubt and the ability to continue and the going concern, and management plans to deal with these events or conditions. Disclose clearly that there is material uncertainty relating to events or condition, therefore that it may be unable to realize its assets, discharge its liabilities in the normal course of business. Are you able to understand? The first point is talking about adequacy of disclosure. How should the auditor disclose? If going concern is not affected, it is all fine, but there is a material uncertainty. See the second one. No material uncertainty exists, but going concern, there is a doubt. Doubt regarding going concern, but material uncertainty is not there. An example for that is, year on year there is losses. Going concern is getting affected. Cash losses, operating losses, all kinds of losses. This company is there. Going concern is getting affected, but material uncertainty is not there because loan is already approved for them. So, material uncertainty is okay, not there. But going concern is getting affected. There is a serious financial indicator. Read here. If event or condition that have been identified that may cause significant doubt on entity's ability to continue as going concern, but based on audit evidence obtained, he is saying that no material uncertainty exists, then in that case, in view of requirements of AFRF, the financial statements provide adequate disclosure about these events or conditions. You have to talk about why there is a doubt in the going concern. There are so many losses, so adequate disclosure has to be made in the financial statements itself. Is that clear, guys? This is auditor's adequacy of disclosures. Next is implications for the audit report. The last part, 3 case study based questions can come here. Implication of audit report. The financial statements are prepared as per going concern basis of accounting, but the auditor feels that it is inappropriate. That means what? The way they have used the going concern is wrong. That means going concern is actually getting affected. Now, should you go talk to people? Directly you will use the weapon because it is affecting all the items in the financial statements. Is there a material misstatement? Yes, definitely. The auditor says going concern is getting affected, but the financial statements is prepared as per going concern basis of accounting. So you will use your weapon and you will give what report? There is sufficient appropriate audit evidence that there is a material misstatement and it is also pervasive in nature. So you will be giving a adverse opinion. Coming to the second case, the financial statements are prepared as per going concern basis of assumption, but there is a material uncertainty. There is a 50-50 probability. Now say for example the management itself has disclosed the material uncertainty. Then in that case, what opinion will you give? Unmodified opinion. We don't have any problem because they have disclosed it as per AFRF. So we will be giving a unmodified opinion. If they have not disclosed it, then you will be giving a qualified or adverse opinion because we don't know the pervasiveness of the case. There is sufficient appropriate audit evidence that there is a material misstatement, but we don't know the pervasiveness. If it is pervasive, you'll be giving adverse opinion. If it is not pervasive, you'll be giving a qualified opinion. Going to the third case, the management is unwilling to extend the assessment. The management is not willing to support you to do the going concern. In that case, there is no sufficient appropriate audit evidence. If there is no sufficient appropriate audit evidence, what opinion will you give? Qualified or disclaimer of opinion based on pervasiveness of the case. If there is no sufficient appropriate audit evidence, but you know that there is a material misstatement and you know it is not pervasive, you will be giving a qualified opinion. If there is no sufficient appropriate audit evidence, but you know that there is a material misstatement and is also pervasive, then you will be giving a disclaimer of opinion. So in this case, you will go for qualified or disclaimer of opinion. I keep telling you, this part is very, very important because they can ask questions as an auditor. How will you react in this case? At that time, link to 705 is there, correct? So they can ask you this question, 570 to 705 link. Now quickly in this essay 570, what and all did we see? Let us see here. We started off with meaning of SA 570. We said this is a fundamental accounting assumption with no intention to liquidate or cease the operations. Significance of SA 570. This has a direct effect on the financial statements. So if the going concern is appropriate, you will be realizing all the assets and you will be discharging all the liabilities. If it is not appropriate, then you will go for liquidation basis of accounting. It deals with what? It deals with auditor's responsibility and the implications. What are the objectives of the auditor? The objectives of the auditor is to obtain the sufficient appropriate audit evidence with regard to the management's use of going concern basis of accounting, whether it is appropriate or not. What is the second objective? Whether material uncertainty exists or not. What is the third objective? Reporting as per the standard. The objectives, again we saw somewhere else. In the conclusions. Objective is conclusion. Yes or no? What is the responsibility of the auditor? Only the first point is actually the responsibility. The remaining 4 points are the disclaimer for that responsibility. What is the responsibility? To obtain sufficient appropriate audit evidence to see whether there is a material uncertainty which exists or not. That is the responsibility of auditor. Next, we enter examples of events or conditions that may cast a significant doubt on entity's ability to going concern. What were the examples? 3 types. Financial indicators, operating indicators and other indicators. Evaluating the management's assessment. What did we see there? Evaluating the management's assessment. See and tell. The preparation and presentation of the financial statement is the duty of the management. So when they are preparing and presenting the financial statement, they have to see whether it is going concern basis of accounting or not. So the auditor will evaluate whether management's assessment of entity's ability to continue as going concern is proper. Yes. If it is not the auditor's responsibility to rectify the lack of analysis by the management. But in some circumstances, the lack of detailed analysis will prevent use. What are the additional procedures? If a condition has a doubt, there is no material uncertainty exists, that will give the additional audit. What are the additional procedures that he will do? He will go management to assess the entity's ability when he has made the assessment and he says what are the plan, whether it is feasible or not. He makes you assumptions. So there will be assumptions for this. The additional factors come to notice, he will be getting written representation. Is it clear? Next one, examples of procedure is MSC, LC word. Auditor's conclusion is responsible for going to. Then we do adequate disclosure, material uncertainty exists, no material uncertainty exists. If material uncertainty exists, and going concern is not, then it has to disclose uncertainty and the management plans come back. Second, no material uncertainty exists in that case. Going concern is doubtful and no material uncertainty in that case. What should auditor do? He should see that adequate disclosure of the financial statement. Which is 3 points we saw here. The first one is financial statement is prepared as per going concern and the audit feels going concern. That will become adverse opinion. Second, as per going concern, material uncertainty exists. Material uncertainty disclosure in the case modified opinion. If it is not disclosed, then it will give a qualified or opinion. Third case, the management will present the evidence, so it will give a qualified opinion. Second, with SA 70 can end. If you see, we took about 30 minutes for this vision. At the same time, we needed 10 minutes for the recording. Like that, after you home, you cannot take more than half an hour to do home and just half an hour to rest. Immediately you have just 5 minutes. Go to all the points again, it will end your head. Just like SA 570. Now, SA 570, you should know all the questions which is there in SA 570. Starting from the so, objectives, conclusion, people, all of those questions first off. Then you keep writing answers for each and every listener. First is 9 marks, you have to do. Overload. Overload. So, this is really what I don't have. For you, it's like, alright, we go now. Go for lunch, break for it. Happy morning, guys. I hope all of you had breakfast and I hope the breakfast was not pongal and vadai. Are you all ready for today's class? Yes? Yes. SA 500, let's quickly see the mind mapping which is there. What is the meaning? Information contained in accounting records, information used as audit evidence, audit procedures, nature and timing of audit procedures, types of audit evidences, relevance and reliability. What is the meaning of relevance? What is the meaning of reliability? Sufficiency and appropriateness. What is the meaning of sufficiency? What is the meaning of appropriateness? Factors affecting sufficiency. Sufficiency basically means what? The quantity. So what are the factors which is going to affect your quantity of audit evidence? Audit procedure for obtaining audit evidence, audit trail, selecting items for testing. If there is inconsistency or doubts about the reliability as an auditor, what we have to do? Who is this person called management expert? How are you going to evaluate the audit evidence? And lastly, we will be seeing what are assertions and types of assertions. Is that clear? Now I'm going to start off. What is the meaning of audit evidence? Now, what is the flow of going and doing the audit? As an auditor, after signing the engagement letter and all, he will be doing the audit procedures to get the audit evidence. Now, based on this audit evidence, is what is he doing? He is giving his conclusion. Now, based on that conclusion, he is expressing an opinion. Now, the meaning of audit evidence is the information used by the auditor in arriving at the conclusion on which auditor's opinion is based on. For this only, I told you the flow, audit procedures he will be doing to get something called as audit evidences. Based on this, he will draw the conclusion, and finally, he will be giving the opinion. So for this he is saying the information used by the auditor in arriving at the conclusion on which his opinion is based on. Audit evidence includes two things: accounting records and also other information. What is that information which is contained in the accounting records? Accounting records can be all your accounting entries and all the supporting records. It can be the invoices, it can be the contract, it can be the agreement, it can also be your Excel sheet, because sometimes the books of accounts will be in the software and separately in Excel sheet they'll have the books of accounts too. That means what? There is some fraud which is happening. If two parallel books of accounts are there, that means some fraud is happening. Now, how are you saying? How did you arrive at that conclusion that fraud is happening? Because of that Excel sheet, which was an audit evidence for you. So, information contained in accounting records also includes worksheet and spreadsheets, and finally, general and subsidiary ledger adjustments. What is the general and subsidiary ledger adjustment? What is the general and subsidiary ledger adjustment? I gave an example for that. Let me see. Okay, furniture and fittings. So I said, it's written here. So you saw, correct? So furniture and fittings, I told you, I gave you an example. That is a main ledger. That is a general ledger. Now under furniture and fittings, so many items are there. This table is a furniture. Projector is what? Furniture. Chair is what? Furniture. Writing pad is what? Furniture. So all of these sub-ledger adjustments will happen. So if there is any adjustments which is happening, that also will be as audit evidence in accounting records. Now apart from this, there is a lag. Let's come back. Till where did we see? Accounting information which is contained in accounting records, that can also be audit evidence, and other information can also be audit evidence. What is that other information which is going to be audit evidence? The minutes of the meeting, written information from trade receivable and trade payable, also called as external confirmation, manuals, internal control manuals, or any other information, whatever you want. If you see something, then that becomes an evidence. Evidence means proof, adharon, that is your evidence. Now in the first Roman number we saw what is the meaning, information contained in accounting records and other information. Now going further, information to be used as audit evidence. Now if information is given by the entity, what and all will you see? If information is given by a management expert, then what and all will you see? If information is given by entity, what is the keyword? CAS, CAS. What is that CAS? C stands for completeness, A stands for accuracy, and S stands for whether it is sufficient. Now see, completeness means what? Completeness means whatever that the management is saying, it is fully complete in nature. Like how you all are saying that you are coming to class. Correct? To your parents you are saying you are coming to class. But after class you will be going, roaming around, and then if you are going home, if mother asks where you went, what you will say? Class. That means the information that you are giving is not complete. It is not false. It is true, but it is not complete. Like that, whatever information the management is giving, it has to be complete, it has to be accurate, and it also has to be sufficient. If information is given by the expert, now we have to see who is that expert, whether he is employed by the entity. Is somebody able to influence that expert? Why do we need an expert? We ourselves are expert. Why do we need an expert? What? Physical verification of asset. Expert means what? Other than accounting and auditing, somebody else will come and do their job. Example. engineers. In limitation of audit, there was one thing called, we will not be saying whether the civil structure is this much age. We don't know the complexity of the machine. We don't know whether it will work or not. So all those things we don't know. For that, somebody else will come and say. How do we know that a machine is 10 years? We are doing depreciation of 10 years on machine. How do we know that this machine is really going to be there for 10 years? We will never know. We cannot identify. Somebody else will come and say that this will be there for 10 years. We will believe his valuation report and we will proceed forward for depreciation. Like that, if any information is given by management expert, then you will be seeing the complexity of the matter, the risk of material misstatement, availability of alternative sources. Okay, one expert is saying like this. Now I have one engineer in my team itself. Now I can ask him to go and do alternative sources. I can ask whether management expert is employed by the entity, extent to which management exercise control or influence over the work of management expert, whether management expert subject to technical performance standard, auditor's knowledge and experience of management experts field of expertise. And previously if I have worked with him, obviously I will be more comfortable. So auditor's previous experience of the work of that expert. There are 10 points which is given here for if information is coming from the management expert. If information is by the entity, then just 3 points, that is CAS. Is that clear? What are the audit procedures? AROR is the audit procedures: external confirmation, inspection, inquiry, reperformance, observation, analytical procedures, and recalculation. The terminologies are there which is very, very important, which you have to remember for each of the audit procedures. The first one is what? Inspection. Inspection means you are going and examining that record, examining that document. That is your inspection. Examination of records or documents, whether it is internal or external, whether you are examining in paper form or on electronic form or any other media, or physical examination of an asset. You are going there and seeing whether that asset is really existing or not. So that is also inspection only. What is inquiry? Seeking the information from knowledgeable persons. Don't seek information from the clerk. Say you go to bank outside, clerk is there. You can't ask that clerk, asking him what is the amount balance which is there. He'll not know the information. So even if he says some information, it is definitely false. So inquiry means you have to seek the information of knowledgeable persons. Now if you go and ask him, you are just taking the mic and saying unga toothpaste la uppu irukka. He is saying uppu irukku. Now can you take that as audit evidence, because it is oral evidence? Can you take that as audit evidence? Yes, sir. You can take that as audit evidence. Just that reliability on that audit evidence will be low, but that is also audit evidence only. Now you all tell me, auditor will consider whistleblower complaints. Yes or no? Whistleblower complaints will be coming orally only. Employee will be telling you orally only, but still you are considering that as an auditor. So this inquiry can be formal written inquiry, or it can also be informal oral inquiry. Both ways it is possible, because as an auditor we can't always be like, oh nee pesriya eldi kudu. How can we say that? It is not practically possible. So whatever he says, we will be accepting that, we will be taking that as an evidence only. What is the meaning of observation? They are doing some process, you are looking into the process, that is called as observation. Looking at a process or procedure which is performed by somebody else. What is external confirmation? Direct written response to the auditor from a third party in paper form or in electronic or any other medium. Now in external confirmation they did not say oral evidence. Did you note that? Only for inquiry, you are going with mic and you are asking toothpaste lo uppu irukka, they will be telling orally to you. But for external confirmation, third party, whatever he is saying, it has to be a direct written response only. Is that clear? What is the meaning of reperformance? Now they are doing some job, we are again doing that job to see whether it is correct or wrong. Say for example, somebody is putting the journal entry. Now from the journal entry automatically it will go to ledger. From that ledger automatically it will go to trial balance. From the trial balance automatically it will go to trading P&L and balance sheet. Yes or no? Now the management has framed this internal control saying this person once he enter, automatically the software is going to do all the other process and give you the balance sheet. Now as an auditor, we will see whether the software is working properly or not. So I will do a re-performance activity. I will put a dummy journal entry as if I'm paying salary. Dummy entry I will put. Rate I will just put as 10,000. Later I can cancel that journal entry. No issues. Or I'll delete that entry. No problem. So why am I putting that dummy entry? To see whether the system is doing it properly. Yes or no? That is re-performing an activity. What is the meaning of recalculation? Checking the mathematical accuracy of documents or records. That is the recalculation. That means computer will say depreciation 10% means this is the depreciation for all the PPE. Now we as auditor, we will see the PPE figure and we will be putting the calculator what is the amount of depreciation, and so that we can verify it with the computer. That is recalculation. What is the meaning of analytical procedures? Plausible relationship between financial and non-financial data. Example, you are having a room. Now this room is 1000 square feet. Now with 1000 square feet room, you are able to make a sale of 1 crore. Now I move to a huge place, 10,000 square feet room. Now with this 10,000 square feet room, how much sale I should make? At least 10 crores I should make, but they made 90 lakhs. Is there a problem here? Yes. Why? Because you compared a non-financial data, that is the square feet, with your sale, that is a financial data. You are finding some kind of a relationship between non-financial data and financial data. To find relationship between two financial data, that is also analytical procedures. Say for example, the marketing expenses is 0. With that I made sale of 1 crore. Marketing expenses became 10 crores. Now how much should my sale be? It should be minimum of 10 crores at least to take my marketing expenses back. Yes or no? So if your marketing expense increase, automatically your sale should also increase. This is a relationship between two financial data. So plausible relationship. Plausible means what? Possible. Possible relationship between financial and non-financial data is called as analytical procedures. Now you all tell me, what are the audit procedures? Error. What is E? External confirmation I. Inspection I. Inquiry R. Reperformance O. Observation A. Analytical procedures, and last R is recalculation. I hope you remember the keywords for each of the audit procedures. Yes? Procedures is done. I am proceeding forward to nature and timing of audit procedures. The nature and timing of audit procedures may be affected by the fact that some of the accounting data and other information may be available only in electronic form or only at certain points or periods in time. So all of these things are going to affect your audit evidence, how your audit evidence is going to be there, and whether it will be there throughout the period or whether it is going to be there only at a particular point in time. Certain electronic information may not be retrievable after a specified period of time. Say for example, they have a system for confidentiality purpose. I will be entering the data, but you can't see the data. So how is that information going to be as audit evidence? In mind and company itself, if you see, if auditor comes and asks, who are your clientele? Can I give the clientele? No. I have to maintain utmost confidentiality. I cannot give the clients outside. So certain information will not be retrievable at all. Here they are saying it will not be retrievable after a specified period of time. In some cases they will take the backup. Backup file, somebody will destroy it. In that case, after a specified period of time, you will not have the data. What are the types of audit evidences? Data assassin? Will not give. You check how you want. Your auditor will not give the client data. There is no debtors. You pay, then you take the consultation. How debtors will come here? There is no debtors for you to verify that. Now types of audit evidences, but auditor will want to see whether there is real sales or fake sales. For that they will want to do the external confirmation. we will not allow for that. You do any alternative audit procedures, no chance. What is the alternate audit procedures? You can inspect the bank account, whether really sales has happened or not. That is the alternative audit procedure. So if something is not there, auditor always has to go for the next one. Now the next one is types of audit evidences depending upon nature, depending upon source. Depending upon nature, how many are there? 3 are there: visual, oral and documentary. Visual means you are seeing something, oral means you are hearing something, documentary means like external confirmation, they are writing and giving it to you. Depending on source, it can be either internal or it can be external. Which is more reliable? The external is obviously more reliable, you all know. Now depending upon nature, which one is more reliable? Documentary is more reliable because you will tell something now and later you will change it. So oral is not reliable. Next is relevance and reliability. Before we go to relevance, let's finish off quickly the reliability. Reliability means what? The trust. If they are giving some information, you as an auditor want to know whether you can trust on that information or not. So information which is used as audit evidence should be reliable in nature. When will it become reliable? You all tell me. It will become reliable when if I take the information from that management itself, or if I take the information from third party. From third party, that means if it is obtained from independent sources, you will say that it is reliable. Now you tell me one more thing. The internal controls are there. The internal controls are operating very effectively and efficiently. You saw that, you tested that, and you are convinced with the internal control. Now if you get the information, will you rely more on that? Yes or no? So whether the internal controls are operating effectively, you will be seeing. If the internal control is operating effectively, you will rely more on the data. For example, let me tell you, the financial statements is prepared and presented by the management. Now they have an internal control system that only, what's your name? That Almara, she can only enter that journal entry in the system. Now if she is entering the journal entry, the system should take, because she is going with that user ID, login, password and all of those things. Say for example, I am going, should it allow? It should not allow, because only one person should have access to the journal entry. Now the auditor is going and testing in somebody else's login. It is allowing for everyone. Will the auditor believe whatever information is produced by the system? No, the reliability instantly drops once he notices that the internal control is weak. That is the reason why the reliability is increased when the related controls are effective. The next is, say for example, the auditor, I am going and getting the information from you, or I am sending my assistant and getting the information from you. Now which is more reliable? If I myself go and get the information, that only is more reliable. Audit evidence in documentary form, you already told me that it is the most reliable. Audit evidence in original document is more reliable than photocopy, that is Xerox and all. Now 5 points are there. These 5 points are basically telling you when your trust is going to increase. What are those 5 points? The first one is, if it is obtained from independent sources, if the relative controls are effective, if it is obtained directly by the auditor, if it is in documentary form, and lastly, if it is original document. In these 5 cases, your reliability automatically increases. What is the meaning of relevance? The relevance means there should be some kind of logical connection between the data. Like how I told you, marketing spend was 0, sale was 1 crore. Marketing spend itself is 1 crore. Now how much should sale be? It should be minimum of 1 crore at least this year, so that next year we will know 2 crores, 3 crores, like that it will keep going. So this is basically telling you that there is some kind of a logic in the data which is there in the financial statement. Once you start finding that logic, you will say that it is relevant. Relevance means logical connection. If the purpose of an audit procedure is to test for overstatement in the existence or valuation of accounts payable, testing the recorded accounts payable may be a relevant audit procedure. What they are saying here, if you are testing for overstatement. Overstatement means, why these lines? Today full tech disturbances. You can see it, correct? You can understand it. Overstatement means what? You are having a doubt that that client is giving extra information for you. Basically, in reality, it is only 1 lakh, but in the balance sheet, debtors figure is 10 lakhs. Now, if you have doubts of overstatement in existence or valuation, testing the recorded accounts payable may be a relevant audit procedure. That means, if you know that, if you think that this is overstated, if you do your audit procedures on this 10 lakhs, you will know exactly as to what is real and what is false. Yes or no? So, you can find out that real is 1 lakh and false is the remaining 9 lakhs. Yes or no? Now see the other scenario. You have doubts of understatement. Understatement means what? The balance sheet figure is 10 lakhs, but in reality, it is actually 1 crore. You have doubts of understatement. In this case, can you do the audit procedures on this 10 lakhs? How will you tell which is real and which is fake? All of this is real only, but apart from this, something else is there. So there is no use of doing the audit procedures here. You have to do audit procedures on something else. So as an auditor, if you look for understatement in the existence, testing the recorded accounts payable will not be relevant. But testing such information as subsequent disbursement, unpaid invoices, supplier statement, unmatched receiving report may be relevant. All of these are something else. So you will be doing the audit procedures on something else. Did you understand this understatement and overstatement? If the auditor feels it is overstated, now what figure he has is something is real and something is fake. Then he can do audit procedures on that figure to dissect what is real and what is fake. Now if he is thinking this figure is understated, that means apart from this something else is to be added. Now there is no point doing audit procedures here because you have to do audit procedures on that something else and not this itself. Did you understand now? That is relevance for you. Relevance deals with logical connection with purpose of audit procedures and where appropriate the assertion. Now read the example, you will fully understand. If the purpose of an audit procedure is to test for overstatement in the existence or valuation of accounts payable, testing the recorded accounts payable may be relevant for audit procedures. Now on the other hand, testing for understatement of accounts payable, testing the recorded accounts payable will not be relevant, but testing some other information will be relevant in that case. Is that clear, guys? A given set of audit procedures may provide audit evidence that is relevant to certain assertions but not to others. Now you have to know what is the meaning of assertion. What is assertion? What is the meaning of assertion? Assertions are basically representations which are made by the management. Assertions can be explicit or assertions can also be implicit in nature. Now there will be one flow chart which is given here. Assertions are two types, positive assertion and negative assertion. Positive assertion means again split into two, implicit and explicit. Negative assertions again split into two, implicit and explicit. Now what is positive implicit assertion? For positive implicit assertion, just see this example which is given here. When we find in the balance sheet an item under current assets reading as cash in hand rupees 10,000, the obvious assertion that would strike the mind is the following. Positive means I am saying something is there. Negative means I am saying something is not there. Now when you see this cash in hand rupees 10,000, is it a positive assertion? Yes. But when you look at this figure, they are implying that the firm had rupees 10,000 in hand in notes and coins on the balance sheet day. That the cash was free and available for expenditure to the firm. All these are implications for that one figure. That the books of accounts show a cash balance of identical amount at the end of the day on which balance sheet figure is drawn up. So all of these 3 points is what this cash in hand rupees 10,000 is basically implying to say. Are they saying that it is there or is it not there? It is there. So it is positive implicit assertion. That is the cash in hand. Is that clear? Explicitly, if I am going to give you all the information and I am saying it is there, that is positive explicit assertion. For example, 12% secured loan of 4 lakhs. This says that I have taken a loan of the amount 4 lakhs and the percentage for that loan is 12%. All the information explicitly I am giving you here itself. This is positive explicit assertion. For negative assertion, if I say something is not there, I have to say explicitly. For contingent liability, if it is not there also in the disclosures, notes to accounts, you have to mention that there is no contingent liability. You are saying something is not there and you are saying that explicitly, that is negative explicit assertion. Now you see this balance sheet, land, furniture, fixture and all the items are there. But about building, nothing is given in the balance sheet. That means what? Building is not there. So when you look at this balance sheet, they are implying that building is not there. That is not there means it becomes a negative assertion. This is an implicit assertion. So it is a negative implicit assertion. Are you clear with assertions? Assertions means they are representations which are made by the management. It can be positive or negative. It can be implicit or explicit. Positive means they are saying it is there. Negative means they are saying it is not there. Explicit means வாய் விட்டு சொல்றான். Implicit means சொல்லாம சொல்றான். Is that clear? Now, for P&L and balance sheet items, there are a few assertions which you have to remember. What are those assertions? Occurrence, completeness, accuracy, cut-off procedure and classification. Here, existence, rights and obligation, completeness, valuation and allocation. This is for balance sheet items. This is for P&L items. Is that clear, guys? This is for disclosures, notes to accounts. Occurrence and rights and obligation, completeness, classification and understandability, accuracy and valuation. Full clarity of assertion you will get when we are doing items of FS. Because there for each item as an auditor, how will you put the tick mark for each of the assertions? You will be doing that activity. Is that clear, guys? Can I move forward? Now we are done with relevance and reliability. Now we have to see what is sufficient and appropriate audit evidence. Sufficiency, as you all know, is the quantity of audit evidence that is required. Now you please tell me, risk of material misstatement means what? Risk of material misstatement means what? Misstatement means mistake. Material means important. Risk of material misstatement means a risk that an important mistake can happen here. Yes or no? Then I changed misstatement. For that separate definition is there. Difference between amount classification presentation disclosure as per AFRF and the difference between amount presentation classification disclosure which is as per the books of accounts, that is as an item in the books of accounts. Now risk of material misstatement meaning you know. Yes or no? With that meaning you tell me, if risk of material misstatement is high, how many audit evidences will you get? Lots of audit evidence or minimal will do? You will get lots of audit evidence. If risk of material misstatement is low, then you will go for lower audit evidence. If something is material, materiality is high, then you will go for more audit evidence. If something is not material, then just one audit evidence is enough. Now, for all homogeneous transactions, homogeneous means everything is similar to each other, everything is same. In the population, 1000 is there, but all are similar to each other. In that case, as an auditor, should you test each and every item, or are you satisfied with a small sample? So audit evidence low, if it is there also, it is okay. Heterogeneous transaction, each and every transaction is different from each other. So how will you make sure that sample is representative of the population? You will select a bigger sample in that case. So heterogeneous means audit evidence will increase. That only is given here under sufficiency and appropriateness. Sufficiency has 3 factors which is going to determine your audit evidence levels. Those 3 factors are only risk of material misstatement, materiality, size and characteristics of population. If you see materiality, less evidence will be required in case assertions are less material to the users of financial statements. On the other hand, if it is material, then more evidence is required. Risk of material misstatement, less evidence will be required in case assertions that have a lower risk of material misstatement. Size and characteristics of population. Less evidence will be required in case smaller homogeneous population. Larger heterogeneous population means audit evidence will increase. Is that clear? Going to the next part. Audit procedures. We saw sufficiency. Did we see appropriateness? What did we see appropriateness? No. What is relevance and reliability? That is appropriateness. Under sufficiency, those factors are only these three factors, nothing else. Is that clear? For reliability, again you saw factors which is going to affect your reliability. 5 factors. Obtained from independent sources, original document, documentary format, directly by the auditor itself. Internal controls are effective. Did you get the flow? Yes. What is sufficiency? What is appropriate? Under appropriate we have relevance and reliability. Under sufficiency we have 3 factors. Now audit procedures for obtaining the audit evidence. There is risk assessment procedure and there are further audit procedures. Further audit procedures again split into 2. Test of controls and substantive procedures. Substantive procedures again split into 2. Test of details and analytical procedures. Test of details again split into 2. Test of transactions and test of balances. Test of transactions is nothing but vouching. Test of balances is nothing but verification. For now this much is enough. SA 330 mind mapping is there, correct? That mind mapping itself is this only. There we will be seeing what is each of the following. Now what is this risk assessment procedure? Risk assessment procedures are audit procedures. For what are you doing? You will be studying this in SA 315. You will be studying in SA 315 what are the risk assessment procedures. What is risk assessment procedures? They are the audit procedures which is performed to obtain an understanding of the entity and the environment. What is the name of SA 315? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. So this is the audit procedures which is performed to obtain an understanding of the entity and the environment. Finally, for what? To identify the risk of material misstatement. To identify and assess the ROM at financial statement and assertion level. What is this test of controls? These are audit procedures designed to see whether the internal controls are operating effectively and efficiently. To evaluate the operative effectiveness of the controls in preventing, detecting and correcting the material misstatement. Is that clear? What are the substantive procedures? These are the audit procedures which is designed by the auditor to detect the material misstatement. That is the substantive procedures. Now this test of control is by whom? Test of control is by whom? This also is by the auditor only, because internal control is framed by the management for the management. Now as an auditor we want to see whether internal controls are operating effectively so that we know whether we can trust that audit evidence. So that testing of the internal control is only the test of control. So we will be doing audit procedures to see whether internal controls are operating effectively and efficiently. That means whether it is able to prevent, detect and correct a material misstatement. Then we went to substantive audit procedures. What is audit trail? It is a documented flow of transaction. The financial statements will be prepared and presented by the management and it will be given to the auditor. Now when the auditor sees one information from the financial statements, debtors 1 crore. From where did this debtors come, sir? It came from sale. Can you show me the sale, sir? Yes, I will show the sale. Now where did the sale happen, sir? Here only. In this building only the sale happened. Can you please show me the invoice? Yes, I will give you the invoice. Like that you are going back in a document format, that is documented flow of transaction. So here you will be seeing how that source document, that is the invoice, is getting translated into an accounting entry and from there it is getting inserted into the financial statement of an entity. Now audit trail does not only mean in terms of accounts but also the log on log off activity, that also is audit trail. Now people will show their access card and they will go inside, they will again show the access card and come out. Now salary, how is it done? Based on the number of hours they worked. How will I get the number of hours they worked? Now I'll take that log as to how many hours he is inside the office, how many days he has actually come to office. I will take that log. That log is also called as audit trail only. This is basically like record keeping evidences, events, procedures or operation because their purpose is to reduce the fraud or error. Is that clear? Selecting the items for testing to obtain the audit evidence. Selecting all the items, selecting specific items. Can you select all the items? No, usually it is not possible for you to select all the items. But there are few circumstances where you have to select 100% of the items. What are the circumstances? Population is small number of large value item. Irukkarade only 3 items. 3 sales bill only are there. 3 crores, 5 crores and another 5 crores. Only 3 are there. How will you select the sample here? You will be testing all the 3 invoices for this company. Small number, only 1, 2, 3 of large value items. There is a significant risk and other means do not provide sufficient appropriate audit evidence. You tried alternate audit procedures, additional audit procedures, you are not able to get sufficient appropriate audit evidence. The repetitive nature of a calculation or other process performed automatically by an information systems make 100% examination cost effective. Or if there is some high value or key items, or what I will say, if there are so many invoices, 10,000 invoices are there. Now I will take an amount which is immaterial for me. What is that amount which is immaterial for a 4,000 crore company? 10,000 rupees, less than 10,000 or less than 1 lakh, I will not test any invoice. After 1 lakh, whatever is there, you show me all the invoices. Like that, I will be testing 100% only in this area. So here, all items over a certain amount or items to obtain the information. All of these are points for 100% examination is appropriate. Inconsistency in or doubts over the reliability of audit evidence. Now what are they saying? You have the audit evidence, source 1 is inconsistent to source 2. That means what? You are seeing that balance sheet figure is debtor 5 lakh is there. You are doing an audit procedure, you are seeing the audit trail, it came from sales, everything is pakka, you saw the invoice also, you inspected the documents, everything you did. Now you are confirming that 5 lakhs is the correct figure. Now you are going for external confirmation. He is saying that I will give only 1 lakh. I cannot give 5 lakhs. I have already paid the 5 lakhs. I don't care. I don't know. You take care. Now this is talking about inconsistency in the audit evidence. That means from one source of audit procedure, I got the evidence as 5 lakhs. In another source, I am getting the evidence as 1 lakh. In that case, as an auditor, what should I do? What should I do? Do another audit procedure, as simple as that. Do an additional audit procedure. If audit evidence obtained from one source is inconsistent with that obtained from another, or if the auditor has doubts over the reliability of information to be used as audit evidence, auditor will determine that modification or addition to audit procedures are necessary to resolve the matter. Who is management expert? An individual or organization who is possessing expertise in field other than accounting or auditing, whose work in that field is used by the entity to assist the entity in preparation of the financial statements. Now when you are relying on the work of management expert, you have to see all of these things. Already we saw 10 points. Now these are additional: competence, capability, objectivity, understand the work of expert, appropriateness of that expert's work. Now you have to evaluate the audit evidence. How you will evaluate the audit evidence? Now the management has to enable the people in the organization to give the audit evidence. Now as an auditor, we will be seeing whether we can draw any kind of reasonable conclusion from that audit evidence. Now based on that conclusion, what are we going to do? We are going to give our opinion. The same thing will be given here. SA 500 audit evidence is applicable to all audit evidences obtained during the course of audit to enable the auditor to obtain sufficient appropriate audit evidence to draw reasonable conclusions on which to base the auditor's opinion. The first point is talking about from audit evidence. You have to get sufficient appropriate audit evidence to get conclusion, and based on that you will be giving your opinion. The auditor has to conclude whether SAI has been obtained to reduce the audit risk to an acceptably low level. What is the meaning of audit risk? Audit risk means what? The risk that An auditor gives an inappropriate audit opinion when the financial statements are materially misstated. When the financial statements, there is a mistake which is there, that means financial statements are wrong and the auditor says that it is correct. This is called as audit risk. That means an auditor making a mistake. Can we say like that? An auditor making a mistake when the financial statements are actually wrong. Is this an audit risk? Financial statements are right, an auditor says that it is wrong. This is not an audit risk, because audit risk is only when financial statements are materially misstated. Why is this not an audit risk? Because nobody is going to rely on this and going to invest or give the loan, but people are definitely going to rely on your clean report, unmodified report, and people will give the loan, people will invest their money in shares, and all of those things will happen. That is why it is audit risk. The auditor has to conclude whether SAI has been obtained to reduce the audit risk to an acceptably low level, and thereby it enables the auditor to draw reasonable conclusion on which to base the auditor's opinion. Is that clear? So as an auditor, he has to conclude that SAI is able to reduce my audit risk. That means I will not be giving an inappropriate audit opinion. That means what? The audit evidence that I have is strong. I know that this is real. That is the reason why I am very confident with my opinion that I am giving. Is that clear, guys? Have we completed? Now quickly from the top, just 5 minutes I will show you how to study the entire standard. We started off with what is the meaning of SA 500. What is the meaning? Information which is used by the auditor in arriving at the conclusion on which the opinion of the auditor is based on. This includes information contained in accounting records and also the other information. What is that information contained in accounting records? What is information contained in accounting record? Worksheets and spreadsheets, invoices, contracts, agreements, general ledger and subsidiary ledger adjustments. What is this other information? Minutes of the meeting, written confirmation from third parties, and internal control manual, and any other information which is used. What is audit procedures? Error, external confirmation, inspection, inquiry, re-performance, observation, analytical procedure, and recalculation. What is this nature and timing of audit procedure? What did we see there? Nature and timing of audit procedures. We saw that audit evidence might be available only at a particular point in time or only for a particular period of time. That means backup record can be deleted. Like how I told you previously, ORCUT used to be there. ORCUT means forever it will be there. Anybody can view that information. Nowadays, Snapchat is there. In Snapchat, you have to hold to see the information. If you leave it, that's it, gone. Again, if you replay once, that's it, gone. Correct? Second time you can replay 10 times. For Snapchat, subscription is there. Really? Anybody has the subscription? Nobody has the subscription, correct? Very good. Don't go and waste your money on all these things. Why you have to see that person snap twice? First of all, waste app. Delete that app if you can. Now, next is what? Nature and timing of audit procedure. Basically, they are saying that it might be available only for a particular point in time and not for a particular. No, it might be available only for a particular point in time or for a particular period of time, and it will not be available forever. Next is relevance and reliability, sufficiency and appropriateness. What is sufficiency and appropriateness? They are talking about sufficiency is talking about quantity, appropriateness is talking about quality. When will you increase your quantity? When risk of material misstatement is high, when materiality is high, and for population, when will you increase? For homo or hetero? For heterogeneous transactions, you will be increasing your audit evidence. This is sufficiency. What is an appropriateness? Relevance and reliability. What is the meaning of relevance? You are looking for logical connection between the data. What is the meaning of reliability? Trust increases for the auditor. When will reliability increase? When it is obtained from independent sources, when it is obtained directly by the auditor, when it is an original document, when it is in documentary format, and if the internal controls are effective. In these 5 cases, your reliability will increase. Now we are done with relevance and reliability, sufficiency and appropriateness, factors affecting sufficiency, audit procedures, types of audit procedures, all of these is done. What is the meaning of audit trail? It is a documented flow of transactions. It's basically a record keeping activity, or log on log off items will also be part of your audit trail. This will basically translate the financial statements, the source document, to an accounting entry. So source document is your invoice, accounting entry is your journal entry that you are putting. It is translating this from here to there. That is only the audit trail. How will you select the items for testing? Will you test 100% or will you not test 100%? You will not be testing 100% usually. Only in some cases you will go for 100% testing. What are those some cases? When it is small number of large value transactions, key items over a certain amount, significant. What similar items? When there is a significant risk, you will go for 100% of. Next is, what is management expert? Who is that management expert? He is an expert in his field other than accounting and auditing. Inconsistency or doubts over the reliability. In that case, what should I do? I just have to go for additional audit procedures. Now I am evaluating the audit procedures. Now, how will I evaluate the audit evidences? How will I evaluate the audit evidence? There are 2 points which is given here. The first one is talking about it enables the auditor to obtain sufficient appropriate audit evidence which enables him to draw the reasonable conclusion based on which he will be giving his opinion. The second point is talking about audit risk. Next we went to assertions. There are 2 types of assertions, positive and negative assertion. Again, under positive assertion, implicit and explicit. Under negative, implicit and explicit. Explicit means outrightly they will tell you whatever they want to tell. Implicit means sollama he is going to tell you. Positive means he is saying something is there. Negative means he is saying something is not there. Assertions are basically representations which are made by the management. Is that clear? Then assertions specifically are there for P&L item, balance sheet items, and also for notes to accounts. Is that clear, guys? Just 7 minutes, we finished that entire revision from top to bottom. SA 501 is basically split into 3. What are those 3? Segment reporting is the third part. Litigation and claims is the second part. Inventory is the first part. Now quickly I will tell you all the points which is there in inventory. Now, in inventory, as an auditor, we are bothered only about 2 things. That is, whether inventory is really there or not. And inventory means what? It should be ready for sale. So, what is the condition of the inventory? We are only bothered about 2 things, existence and condition of inventory. For this, the auditor will be doing audit procedures. Now, audit procedures ideally has to be done when? For inventory, because inventory in sonnale, the first thing which comes to your mind is physical verification of inventory. When should this physical verification of inventory be done? What reasonable interval? It should be done by the management at reasonable interval. As an auditor, when should we see whether the management is doing the physical verification of inventory? As on 31st of March, they are showing that stock is 10 lakhs. Really, whether stock is 10 lakh or not, auditor will want to know. So, as on 31st March, he has to go there and he has to see whether physical verification of inventory is done properly by the management. So, as on 31st March, he ideally has to go. But if that date physical count is not possible, then he will be selecting an alternate date and he will do the audit procedures on the intervening transaction. Now, what is this alternate day and what are the audit procedures and what is that intervening transaction? Say, for example, 5th of April, he is going and doing the physical verification of inventory. Now, whatever amount is there in 5th of April will obviously not match with the amount which is there as on 31st of March. Yes or no? Obviously, it will not match. So, as an auditor, we get the physical verification of inventory as on 5th of April. We have to add something, subtract something, and get the stock as on 31st March. What will you add? What will you subtract? Purchase. Now, simply if you add the sales and subtract the purchases from the books of accounts, is that correct? You have to verify whether this sale really happened or not. So, you will be doing audit procedures on this purchase and sales for you to verify that this figure that you are arriving is correct or incorrect. Is that clear, guys? So, physical verification of inventory is ideally is to be done on 31st of March. But in case at that date it is not possible, then the auditor will be selecting an alternate date and he will do the audit procedures on the intervening transactions. Say for example, physical count is impracticable. Physical count is impracticable. That means the stock is in Pakistan. Can the auditor go there? Will you go there? No. So what should the auditor do? He will be doing alternate audit procedures, and finally if alternate audit procedures also he is not getting any information, then he has to use his weapon, that is modification SA 705. See, understand here, first he'll try to do the physical verification as on 31st of March. If he does it, well and good. If he's not able to do it, he'll select an alternate day. If he selects an alternate day, he has to do audit procedures on the intervening transactions. Now, if that physical count itself becomes impracticable, then he will go for alternate audit procedures. If in that alternate audit procedures also is not able to get any information, then he will go for modification, that is SA 705. Next is impracticability because of nature and location. Some nowadays warehousing services is becoming extremely popular. Yes or no? Say for example, if you want to order my books also, the warehouse is in Pune, because here in Chennai, color book 10 rupees per printout. Is it possible to do it? No. Pune means only 1 rupee. So there they have a huge warehouse. In that warehouse they will keep the book. Now if you want to do physical verification of my inventory, that is the books, what I will tell? You have to go to Pune and do. Now if it is in Pune, you will definitely go. But if it is in Pakistan, you cannot go. In that case, it becomes impracticable because of nature or location. Now I told you example only for location. How can the nature of that inventory itself become impracticable? Say for example, for the government military, they want to know how many guns are there, how many AK-47 is there, like that they want to know. Now how will you go there and see everything? It is not possible for you to not touch, not even go close by. Yes or no? So it is impracticable for you to do the physical verification. In that time, what will you do? You will ask for confirmation with that person who is at the warehouse. He will be confirming the quantity and he will also be confirming the condition. The confirmation from that warehouse person should come for the quantity and the condition. If possible, you will be doing the inspection, but if you are not able to go there and do the inspection, you will be going for other audit procedures. What is this other audit procedures? You have to remember acid. What is that acid? You will ask another auditor to go. If you have friend in Pune, then you can ask him to go to Pune. He is in Pune only, means he will ask him to go to that address and do the physical verification. You will ask another auditor to go. What is C? Collateral. What is collateral? Pledged as collateral. Say inventory is pledged as collateral with somebody else. In that case, we have to ask him for the documents of that collateral. Internal controls. If the internal controls of that warehouse is operating effectively and efficiently, you will be satisfied that whatever information he is giving as part of the condition and the quantity, whether it is correct or incorrect. What is the D? The documents, any other related documents for this inventory, if it is there, you will be seeing that that is the other audit procedures that you will be doing. So it is impracticable because of nature and location. You will ask the person who is holding the inventory for the confirmation of the quantity and also the condition of the inventory, and after that you will be doing inspection or other audit procedures. Is that clear? Now what are the matters which are relevant in planning the attendance at physical inventory counting? You have decided, okay, Pakistan also I will go and I will do the inventory counting. Physical verification is very, very important. I will go. You have decided to go. Now, what are the matters which are relevant in planning the attendance? What are the matters? What is the nature of the inventory? You will have to see that. Stages of completion, that means whether it is at raw material stage, whether it is at work in progress stage, whether it is at finished goods stage. Stages of completion. Risk of material misstatement. If I know that ROM is high, definitely I will go there even to Pakistan and I will do the inventory verification. Anything else? Location. For me to do the physical verification, I need to know where I have to go and I have to do the physical verification of the inventory. What is the timing? How is the perpetual inventory records? What is the meaning of perpetual inventory? Inventory which is in live. That means whatever is happening there, everything is entered into the system. So if I see that system itself, I know exactly what is there in work in progress, what is there in raw material, and what is there in finished goods. In most of the cases, in food items, the work in progress, finding that is very, very difficult. I told you an example. Sri Krishna Sweets, Mysore Pa. They will be adding all the ingredients. As an auditor, can you say, stop, I want to weigh how much is here, I want to check the inventory. You can't do all those things. So if you are satisfied that they are having that perpetual inventory system, then you will just see the system and you will be like, okay, everything is as on track only. Anything else which is relevant in planning the attendance? Whether any expert opinion, whether it is required or not? Anything else? Internal controllers point is here. Internal controls, how are they? Are they operating effectively and efficiently? The auditor's experience, that will also tell him. Previously, I know all of these problems were there. So, I know exactly where to go and see the problem. So, the experience of the auditor. And finally, last point is adequate procedures. What are the procedures that I should do? Now quickly let's finish off the inventory. Inventory, you are going to see two things, that is existence and the condition. When inventory is material, the auditor will obtain SAI regarding the existence and condition by doing a physical count of inventory, attendance at physical count of inventory. The auditor will not be doing the physical verification of inventory. The auditor will be present there when the management is doing the physical verification of inventory. That is why they are saying attendance at physical count of inventory. Unless impracticable to evaluate management's instruction, observe the performance, inspect the inventory and perform the test count. If you are not able to do all of those things, then no one can save you. Otherwise, you definitely have to go and do the attendance at the physical count of inventory. Performing audit procedures over the entities final inventory records to determine whether they accurately reflect the actual inventory count. Now, attendance involves inspecting the inventory for its existence and the condition and performing the test count, observing the management instruction and obtaining as to reliability of count procedures. Case number 1. As on 31st March, auditor is unable to do it. Anything which is given as case is very, 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 very important. Case number 1. If auditor is unable to attend, then the auditor will observe physical count at an alternate day and he will perform audit procedures on intervening transaction. Whether changes in inventory amounts between the count date or date and the final inventory records are properly recorded, included perpetual inventory records are properly adjusted, reliability, reasons for significant influence. What are they saying here in this point? Whether changes between count date and final inventory records are properly recorded. What are they saying? Don't know when you are going to record. Final inventory records is on 31st March. You might record on 5th of April. At that time, you see whether perpetually inventory records are properly adjusted. If it is in live, it will be as per 5th of April. So you have to adjust for this 31st March. Add the sale, subtract the purchases. Reliability of that perpetual record and reason for the significant difference. If the attendance becomes impracticable, then he will be doing alternate audit procedures, and if that is also not possible, then he will go for modification. Case number 3, impracticability is because of nature or location of the inventory. When inventory is in custody of third party, then he will request for quantity and condition. He will ask them itself, you please let me know the condition, whether it is available for sale. You please let me know what is there with you, that is the quantity. Perform inspection or other audit procedures as appropriate in the circumstances. What are those other audit procedures? It is ACID. What is ACID? A stands for arranging for another auditor to attend. C stands for pledged as collateral. I stands for internal control, and D is inspecting the documents. Matters relevant in planning attendance at physical inventory counting. May 25 this was tested. All these points you told me: nature of inventory, stages of completion, risk of material misstatement, internal control related to adequate procedures, timing, perpetual inventory, location, and whether assistance of auditors expert is required. Now coming to litigation and claim. In litigation and claim, there we saw existence and condition. For litigation and claim, what is the assertion that we are seeing? Completeness is the assertion that we are seeing for litigation and claim. What are these lines here and there? Litigation and claim, the assertion that you will be seeing is completeness. That means whatever is there in the books of accounts, that only actually is there, nothing else is missed out. Now you all tell me how the auditor will be doing the audit procedures to see what are the litigation and claim. First, he has to go and inquire. He will be inquiring with two people. He will inquire with management. He will also inquire with in-house legal counsel. Who are these people? In-house legal counsel. For litigation and claims, you have to remember two people, that is in-house legal team and the external legal counsel. For this example we took was Sun TV. Sun TV, huge company. Every day they will be getting the cases against them. So internally there will be people who are working, who are lawyers, who are part of the team of Sun TV itself. External legal counsel means they are the legal team who are going to go to the court and talk for Sun TV. Now the audit procedures involve inquiring with the management and also with the in-house legal team. What's the problem? Why it's coming like this? Anywhere else you saw like this in someone else's class? No? Which line? This one? Now there is no problem. Then I'll increase the thickness here. Now it's okay? Yes? Now inquiry with the management and inquiry with in-house legal team has to be done. Anything apart from that, can I do any other audit procedure? I will go and read the minutes of the meeting. In the minutes, if they are talking anything about legal expenses, or if they are talking about, oh, what happened to this case, then you can have that solid audit evidence. The third one is, if they say there is no cases pending in my organization, and you saw in the legal expense account that they have paid 10 lakh rupees, then isn't this an evidence that some legal expense is there that shows that completeness is not there? Yes or no? So that audit procedures you will be doing. And the last one is confirmation with external legal counsel. First you inquired with the internal legal counsel. You need to know whether this is right or not. So you will get the confirmation with the external legal counsel. There are 4 audit procedures that you will be doing here. Say for example, the litigation and claim is given as 5 crores is in stake. Now this 5 crores in stake means if I lose the case, I have to pay the 5 crores. If I don't lose the case, then I save the 5 crores. Now this 5 crores is stake, and they have shown this in the books of accounts. They have written that in the notes to accounts also. Now when you did all these audit procedures, you understood that it is not 5 crores, it is 50 crores. Your audit procedures is telling you that other litigation exists. If your audit procedure tells you that other litigation exists, then you will seek for direct communication with the entity's legal counsel. First with the entity's legal counsel, and then you will go for the external legal counsel. When you go to the external legal counsel, you have to give something called as letter of inquiry. With that letter of inquiry, you will be going to the external legal counsel. Now that external legal counsel is also not responding properly. In that case, you will be doing alternative audit procedures, and finally you will go for 705 modification using of weapon. Is that clear? Now just see the flow. Your audit procedures is leading to other litigations which is possible. What is the assertions that you are seeing here? Completeness. So completeness is at stake. Now if this is the case, then you have to seek direct communication with the entity's legal counsel. Entity legal counsel. Next, in this also, if you are not able to find any information, then you will go for external legal counsel, and this has to be done with letter of inquiry. Then if external legal counsel also is not giving any information, then you will do alternate audit procedures. In that also, if you are not able to get any information, you will go for modifications, that is SA 705. Is that clear, guys? Now when will you go for external legal counsel? When you will go for external legal counsel? So bad this is. When you feel that risk is very high, or if you are not able to understand anything, it is highly complex as to what is happening in the organization, and you found out that there is a fight between the management and the external legal counsel, disagreement between management and external legal counsel. In this case, you will directly give the letter of inquiry to the external legal counsel. Now you all tell me, external legal counsel means he is a lawyer. Lawyer's profession, noble profession or not? Can you go and disturb them like that? You have to first ask the management for the permission, for the contact details. If the management is not giving any kind of permission, then what you will do? Then you will do the alternative audit procedures. In alternate audit procedures, you are not able to get any information, then what you will do? You will use the weapon, you will go for modification. Now say for example, the permission from management is given. You are going to external legal counsel with your letter of inquiry, you are asking the questions, but there is no reply from the other side. In that case, what should you do? Alternate audit procedures. In that alternate audit procedure, if nothing is there, you will use your weapon, you will go for modifications, that is SA 705. So basically the flow of the second part is like this. You will be doing the audit procedures by way of 4 things: inquiry with management and in-house legal team, minutes of the meeting, legal expenses account, and lastly any confirmation with external legal counsel. Now with these 3, it is showing that there are more litigations which is there, or if there is high risk of material misstatement, then you will seek to communicate with entities legal counsel. Then you will go for letter of inquiry to the external legal counsel. For this, you need the permission from the management. If the management is not giving the permission, then you will do the alternate audit procedures and SA 705. If you communicated to the external legal counsel and information from external legal counsel you did not get, then in that case you will be going for alternate audit procedures, and in alternate audit procedures also you will not get any information, you go for SA 705 modification. Is that clear, guys? Now we will read the theory. Auditor shall design and perform audit procedures to identify litigation and claim involving entity which may give rise to risk of material misstatement. What are those audit procedures? inquiry with management, including in-house legal counsel, reviewing the minutes of the meetings, reviewing legal expense account. If the auditor assesses a risk of material misstatement regarding litigation or claim that have been identified, or when audit procedure performed indicate that other litigation or claims may exist, that means completeness have been compromised here, then in that case, the auditor shall seek direct communication with entity's legal counsel. The auditor shall do through a letter of inquiry requesting entity's external legal counsel to communicate directly with the auditor. If law or regulation prohibits, or then the auditor will perform alternate audit procedures. The auditor may seek direct communication through letter of specific inquiry. He will be asking the list of litigation where available, management's assessment of that outcome, a request that entity's external legal counsel confirm the reasonableness of management's assessment. When he is asking the external legal counsel, he can ask in these three areas. When will the auditor judge it necessary to meet with external legal counsel? When there is significant risk, when the matter is complex, when there is disagreement between management and entity's external legal counsel. In these three cases, he can go for external legal counsel. If management refuses to give the permission, or if the entity's external legal counsel refuses to respond, then the auditor is unable to obtain sufficient appropriate audit evidence, so he will go for alternate audit procedures. Then alternate audit procedures also not possible, then you will go for SA 705 modification. Is that clear, guys? The next part is segment information. Segment information, the auditor has to obtain sufficient appropriate audit evidence and understand the methods which is used by the management, whether it is as per AFRF. Here they are going to see the financial statement as a whole and not only on segment basis. For example, Tata is there, it has so many segments, so we will not be seeing segment basis, we will see Tata as a whole. Segment can be based on different products or services, different geographical location also, north, south, east, west also can be different segments which is there. Examples of matter that may be relevant when obtaining an understanding of the methods used by management in determining the segment information. Now, what are the matters that is relevant for understanding the segment information which is used by the management? Now, segment information in accounting standard you studied AS 17. Accounting is done by whom? Management and TCWG. So it is their duty to do it as per the AFRF. It is our duty as auditor to see whether they have done it as per AFRF. Now, examples of matters that may be relevant when obtaining an understanding of the methods which is used by management in determining the segment information. What are the areas that as an auditor you will be seeing for understanding the segment information? First one is sales, transfers, charges between segments and elimination of inter-segment amounts, comparison with budget, allocation of assets and costs, and consistency with the prior period. These 4 points you will be seeing to get an understanding of the segment reporting, whether it is as per AFRF. Is that clear, guys? Yes, we saw this fully in detail. Now we did a quick revision in just 20 minutes of time. Is that clear? 5 minutes for you to revise now. Please take that time.
Happy morning, guys. I hope all of you had breakfast, and I hope the breakfast was not Pongal and Vadai. Today we're going to see SA 520 analytical procedures. Before we get into any standard, we will be seeing the mind mapping. This mind mapping is basically going to tell you what can you expect from this standard. What is the standard telling you at the end of the day? These points it is going to cover. Okay, like that you will have an understanding of the standard even before you enter into the standard when you do the mind mapping. Now, SA 520 analytical procedures, you are not going to make mistake with the name and number of the standard. Are you all right? Okay. Now, starting off with the meaning of analytical procedures. When we go to types of analytical procedures, there are 5 types of analytical procedures. What is the scope of the standard? Why is the standard even existing? You have that doubt. I also have that doubt. So, the standard itself is talking about the purpose of having SA 520 analytical procedure. What is the timing? When should I do the standard? When should I do this analytical procedure? Should I do it at the beginning of audit, middle of audit, end of audit, throughout the audit, whatever it is? The standard is going to talk about the timing of the analytical procedure also. Now, when the auditor is doing this analytical procedure, is that something that I have to consider? What are the factors to be considered by the auditor? 7 factors are given here. Then how do I do the analytical procedures? The techniques for doing the analytical procedures. 4 techniques are given here. Now, as an auditor, when I'm doing SA 520 analytical procedures, I have few responsibilities, 4 responsibilities for the auditor. Now, I have done the analytical procedure. I have some result with me. How am I going to dissect this result? How am I going to see the value of doing the analytical procedures, investigating the results, and finally coming into a conclusion? Are you able to understand as to what you can expect from SA 520 analytical procedure? Yes. Now I'm going to get into the standard. The first one is talking about the meaning of analytical procedures. Analytical procedure means evaluation of financial information through analysis of plausible relationships among financial and non-financial data. Now, if you see the keywords are given in red, you are evaluating the financial information through analysis of plausible relationship. What is the meaning of plausible? No hi-fi English and all. Plausible only means possible relationship. If there is any relationship possible among both financial and non-financial data also they are seen. Now, basically, the auditor is evaluating only the financial information. This financial information, he is finding if there is any relationship with another financial information or if there is any relationship with a non-financial information, the auditor is going to see. That is only analytical procedures. Of course, you would not have understood the entire meaning, but I will come back to this meaning after we finish everything, and then 100% you will understand what I am trying to tell. The second Roman is the types of analytical procedures here. Types of analytical procedures, we can say that it is split into 5 broad types. Comparison of client data with industry data, comparison of client data with similar prior period data, comparison of client data with client determined expected results, comparison of, if I keep on saying like this, you are not going to understand anything. Now, just be with me. The first one is talking about comparison of client data with industry data. Ignore those lines, guys. When negativity comes, you should just ignore it. No use of removing. Leave it. Comparison of client data with industry data. Now, what are they saying here? Say, for example, the client you went for audit, you saw that the P&L account has a rent of 5 lakh rupees. See, if you try to remove, the actual content also will get removed. The rent of your client is 5 lakh rupees. Now, in the next year, you saw rent of your client is 5 lakh rupees. In the next to next year, you saw rent of your client is 5 lakh rupees. Can you say that year on year, this client is giving 5 lakh rupees only? I am okay with this. No. Say, for example, this client is situated in Express Avenue Mall. Which mall? EA Mall. You all will go with boyfriend, girlfriend, watch the movies in this mall, correct? Now, for people who are outside Chennai, you think of some mall in your place. For Coimbatore, boyfriend, where he'll take you to that Brooksfield Mall, he will take. Kerala, our favorite Lulu Mall is there. So, you think of any mall in your place, okay? Now, when you go to Express Avenue Mall, in the first floor, if you see, all the sports shops will be there. Adidas will be there. Puma will be there. Reebok will be there. Yes, all the sports shop will be there. Say your client is Adidas. Now this Adidas is paying how much rent? 5 lakhs rupees rent. Your friend is doing the audit of Puma and Reebok. She is telling you in the same place, similar square feet only, everybody is there. They are paying only 1 lakh each. And Adidas is paying 5 lakhs. Now, once you get this information, what is your brain telling you? There is some fraud which is happening here. Why are they expending too much of money in the place of 1 lakh? Yes, what you basically did is you compared your client data with industry data. The same industry, Puma and Reebok, they are paying only so much of rent. Why is my client paying so much more? You compare the client data with the industry data. This is the first type of analytical procedure. Now moving on to the second type of analytical procedure. The second type is talking about comparison of the client data with similar prior period data. You are comparing the client data with similar prior period data. Now say for example, the same rent is becoming too much. The same rent, 5 lakhs is paid in the current year. Now you are seeing the previous year figure. In the balance sheet or P&L, you can see current year, previous year parallel to each other. In the previous year figure, you are seeing that it is 1,50,000. Now automatically you are getting a doubt. Is this rent only for this establishment, or is there any other franchise, any other branch which is opened by this person? Or has the rent increased to so much of level? Or have they expanded their operation to another floor also in the same building? Like that, multiple doubts you are going to get. Why are you getting that doubt? Because you performed something called as analytical procedure. You compared your client data with similar prior period data of the same client. First, what did you do? You compare the client data with industry data. Now you compare the client data with similar prior period data. I hope you understood. The third type is comparison of the client data with client determined expected results. What is the meaning of client determined expected results? Now say for example, marketing expenses. Where will it come? Good, it will come in the P&L. P&L debit side, right? Any doubt in that? Now, marketing expenses is there. This marketing expense for the previous period was 0. For the current period, it is 5 lakhs. Are you having a doubt? Why there is a sudden increase in the marketing expense? You are having the doubt. Now, you are going and asking the management, sir, what is this, sir? All the previous years it is 0, and suddenly for the current year marketing expense has increased to 5 lakhs. Now the client is going to tell, sir, you please see the sales figure. All this while we were growing at probably 10% increase year on year. Now the last year sale, if you see, it was only 25 lakhs, sir. Because I spent 5 lakhs on this marketing, instead of growing at 10%, this has basically grown at 100%, sir. 100% growth, it has doubled, sir. It has become 50 lakhs or it has become 100 lakhs. More than 100% growth. It has become so much because of marketing expenses. Basically, what the auditor is doing is he is asking the client for this data, and client has made this expenses thinking that his sales is going to increase from 25 lakhs to 100 lakhs. Now, is the auditor satisfied with this expense? Yes, the auditor basically compared the client data with client determined expected results. Now say for example, the sale itself is 25 lakhs in the previous year, 25 lakhs in the current year. At least before the marketing, there was some 10% increase. Now no percentage increase. It is same as last year. Now the auditor, will he be satisfied? He will be able to do more audit procedures. He will be able to ask questions to the management. That is the analytical procedure that he has done. He is basically comparing this client data with client determined expected results. The fourth one is talking about comparison of the client data with client determined expected results for non-financial data. What is this client determined expected result for non-financial data? Now say for example, the sales from 25 lakhs has become 250 lakhs. How did this become, sir? How did the sale jump like this? Sir, you please see my square feet. my square feet, if you see, previously I was operating only at 1500 square feet. Now I've increased my operation to 10,000 square feet, sir. I've put many more machines. I've put multiple other people and I'm operating in a bigger space. Now, it is a client determined expected result, and this square feet, is it a financial data or a non-financial data? It is a non-financial data. So, you basically compare the client data with a client determined expected result for a non-financial data. The fifth one is comparison of the client data with auditor determined expected results. What is this auditor determined expected result? Will auditor also have an expected result? Yes, auditor also will have an expected result. I'll show you how. Say for example, sales have increased from 25 lakhs to 250 lakhs. Alright, sales has increased from 25 lakhs to 250 lakhs. Now, gross profit is there, correct? Now, say previous year gross profit is 5 lakhs. That means what is the gross profit percentage? 5 divided by 25 into 100. Tell me the percentage, guys. What is it? 1 by 5. 100 by 5 is what? How long you'll take for this 20 percentage? Yes. Now, the same 20 percentage you will be expecting for the current year also. Now, out of this 250 lakhs, you will be doing the 20 percentage and you will be expecting for current year also. But what is going to happen? Instead of 50 lakhs, same 5 lakhs is there in gross profit. Or say 10 lakhs is there in gross profit. Will you be happy that it has doubled? No. Here it is 10 times increased. Here also you will be expecting 10 times. Just because it is double, you will not be happy with this. Now, auditor has an expected result in his mind. So, you are comparing the client data with the auditor determined expected result, which was 50 lakhs. Auditor's expected result was 50 lakhs. Now, the actual client data is only 10 lakhs. Now, you are able to ask the question to the management. Now, you will be doing the alternate audit procedures. This is analytical procedure where you are comparing the client data with auditor determined expected results. These 5 are the types of analytical procedures. First one, comparison of client data with industry data. For this example, I told you was Adidas, Reebok, Puma, rental. Comparison of client data with similar prior period data. Current year with previous years, I am comparing. Comparison of client data with client determined expected results. Marketing increase, sales also will increase. Comparison of client data with client determined expected results. But this time the auditor is using which data? Non-financial data. Non-financial data can be square feet. The number of laborers. All of those things are non-financial data. Comparison of client data with auditor determined expected results. For this, it could be GP ratio or inventory turnover ratio, all of those things. What is the scope of SA 520? What is the objective of the auditor? That is a third Roman number. Scope of SA 520. When you're doing the analytical procedure, you are basically getting audit evidence, yes or no? You're getting some kind of an evidence to see whether whatever is happening is reasonable or not. Yes, to obtain the relevant and reliable audit evidence when using the analytical procedure. Now, at the end of audit, they will be doing analytical procedures for what? To see, I have drawn one opinion, I have drawn a conclusion, overall conclusion, whether financial statements are as per whatever I have understood of the entity. Now, whether my conclusion is correct or not, I can do analytical procedures at the end of the audit to see whether my conclusion is correct or incorrect. That is the scope of SA 520. Does that mean that you will be doing analytical procedures only at the end of the audit? No. The second point is talking about doing analytical procedures near the end of the audit. But first point is talking about to obtain the audit evidence. When will you obtain the audit evidence? At the end of the audit? No. You will be obtaining the audit evidence throughout the audit. That is the reason. Now I am jumping here. What is the timing of analytical procedure? The timing of analytical procedures, all the stages of the audit. I told you it is there at the completion stage. It is also there at the planning stage and the testing stage also. That is why it is there at all the stages of audit. Is that clear? Now, I'm going back to the meaning. I told you after few points, you will understand the meaning better. The meaning of analytical procedures. Analytical procedure means I am evaluating the client data. What data? The financial information of the client data by finding some possible relationship between another financial information or some other non-financial information. Now I hope you are able to appreciate the meaning of analytical procedures. Is that clear, guys? Now I'm going to the purpose. We've missed out the purpose, which is fourth Roman number. Yes, we finished meaning, types, scope, and timing. What is the purpose of analytical procedure? Why should an auditor do analytical procedure? Now you yourself tell me, when I did the comparison of client data with industry data, or when I compared the client data with the prior period data, what did I come to know? I came to know whether I can believe this data or not. Yes or no? I came to know whatever this data is given to me, whether it is reasonable or not, whether I can trust this data, whether there is some problem in this data. So the purpose is a reasonableness test. Analytical procedures use comparison and relationships to assess whether account balances and other data appear what? Reasonable. Basically, why you are doing analytical procedures? To see what you have in hand, whether it is reasonable data, whether I can trust this data. For this, you will be comparing the balances on statement of profit and loss with the previous period. You will be comparing expense ratio with same ratio for previous period. If there are any differences which is found, and if that difference is material, then auditor will ascertain reasons which have been manipulated to inflate the profit or suppress the profit. It can also help in identifying unusual transactions or unusual events. It is helpful in detecting unusual state of affairs. Any unusual or unexpected relationship, if it is there, that also you can track it. Basically, the last 3 points are talking about unusual transaction event, unexpected relationship, unusual state of affairs. Now the first few points are talking about whether it is appear reasonable. For that, you will be comparing the balances with P&L with the prior period. You will be doing some ratio analysis. If there are any differences which is found to be material, you will be finding the reasons why it has been manipulated, either to inflate the profit or to reduce the profit. Either cases it is possible. Why will you inflate the profit? You will inflate the profit if you have investor money in your hand. You will want to show the investor that you're doing well. Or if you want to get more investment money, then you'll be inflating the profit. Why will you suppress the profit? The obvious reason is to not pay the taxes. So both it is possible. Depending on the facts of the case, both are possible. We as auditors will have to see whether the client is trying to inflate or suppress the profit. Now auditor will ascertain the reasons whether it has been manipulated for inflating or suppressing. That is the purpose. What is the main purpose again? Whether it appears reasonable or not. Is that clear? Timing is done. Now I am jumping on to factors to be considered for substantive analytical procedures. Now we are here. Factors to be considered. I told you there are 7 factors. Now before I do analytical procedures, what are the things to consider? The first thing I have to consider is, what am I doing the analytical procedure on? I am doing it on financial data. Yes, analytical procedure means evaluation of the financial information. So for you to do analytical procedures, the information must be present. That is the first point, that is availability of data. Are you able to understand? Now going down. Availability of data, that is the first factor which is to be considered when you want to do analytical procedures. The availability of relevant and reliable data will facilitate an effective analytical procedures. What is the meaning of disaggregation? Disaggregation is basically the opposite of aggregation. Aggregation means what? Putting everything together. Disaggregation means what? Splitting everything away from each other. Yes or no? Now, if you're able to split the data, you can do more analytical procedure. The degree of disaggregation in that available data will directly affect the degree of usefulness in detecting the material misstatement. What is the account type? Whether it is P&L or whether it is balance sheet. P&L is a accumulation of all the transactions which happen throughout the year. What is balance sheet? It is a balancing figure. It is a position statement. That is a net effect of all the transactions. Yes or no? Now here, where can you do more analytical procedures? Obviously the P&L, because it is an accumulation of all the data, so it is easy for you to disaggregate also. So account type, the substantive analytical procedures are more useful for one type of account. P&L represents accumulated transactions and therefore they are more predictable in nature. What is the source of data? Transactions of repetitive nature like sales and purchase can be used for efficient analytical procedure. Significant classes of transactions which are not frequent, that is difficult to predict. Say for example, there is research and development expenses. Now this year 5 lakhs R&D I have spent. Can I compare with similar prior period data? Can I compare my R&D expense with other industry data? Of course not. I am doing R&D because I want to stand apart from the industry. Obviously, I am spending because I want to be much better than him, much better than the competitor, yes or no? So this expenditure on research and development and all, it is not of routine nature and therefore a lot of management judgment is involved. Therefore, prediction is difficult. Whenever prediction is difficult, analytical procedure usage will also be reduced. So if it is a repetitive nature, sales, purchase, marketing expense, salary, rent, yes, month on month you will have to pay the rent. So if it is repetitive in nature, then automatically it becomes predictable. If it is predictable, then automatically you can use the analytical procedure. That is the next one, that is predictability. Substantive analytical procedures are more appropriate when an account balance is more predictable. Example, between sales and cost of sales, or between trade receivables and cash receipts. Yes, of course, how much you have to receive and how much you have actually received, these two data are predictable. So you can use analytical procedure there. What is the nature of assertion? Substantive analytical procedure is more effective for some assertions than for others. Assertions like valuation, assertion like completion, yes, it is more predictable there. Write over an asset, how can I find out whether there is predictability there? Not much. So rights, obligation and all, the predictability comes down. Analytical procedures usage also comes down. What is assertion? What is the meaning of assertion? In 500, I have already told you, but still I will be brushing it right now. Assertions are basically the representations. Very good. I'm so glad you all remember. These are the representations which is made by the who? Auditor. Is it made by auditor? No. Think and tell me. Assertions are representations made by the management. Yes. For what are they making? Where are they making? This is embodied in the financial statements. To consider different types of potential statements. Assertions are of two types. Yes, what are the two types? Positive assertion, negative assertion. Under positive assertion, again can I split into how many types? Implicit, explicit. Under negative assertion, again I can split into implicit, explicit. Positive means I am saying something is there. Negative means I am saying something is not there. Say for example, cash in hand is 10,000 rupees. That means what? I am making an assertion that when you go on 31st March and when you see that cash in hand, real cash which is in the hand, you will be seeing 10,000 rupees worth of cash either in notes or by way of coins. You are saying that it is there. That means it is a positive assertion and you are implying that notes and coins worth 10,000 will be there as on 31st March. So that is a implicit positive assertion. Are you able to understand? Yes. Now coming to negative assertion, explicitly if I have to say something, something is not there. Say for example, if there is no contingent liability, where will you mention that? Should you mention that? Yes. In notes to accounts, you will be writing there is no contingent liability, like that you will be explicitly mentioning that. Explicitly you are mentioning that something is not there, so it is a negative assertion and it is a explicit negative assertion. How can you imply that something is not there? Now listen to this. In the balance sheet, if they tell you that land is there, furniture is there, fixture is there, current asset is there, stock is there, under this bank is there, everything is there. Now they are implying to you that building is not existing in this company. Yes or no? If they're saying it is not existing, that means it is a negative assertion, and here they are implying to you. So it is an implicit negative assertion. Are you able to understand? Positive is very easy. I'm telling you that it is there. Explicitly, I am telling you that it is the 12% secured loan of 2 lakhs. If I'm giving you this information and I'm also saying about this loan collateral which is given for 4 lakhs, like that, I'm giving all the information explicitly, and the balance sheet, when you look at this, it is telling you that it is there. So it is a positive explicit assertion. Are you able to understand? Yes. Now, these assertions will be different for account balances. These assertions will be different for class of transactions, and these assertions will be different for presentation and disclosure also. That is your notes to accounts. For existence, where will it come? You're saying something is existing. You can say an asset is existing. So obviously it is a account balance assertion. You are saying for rights and obligation. Where will it come? Rights and obligation. I have a right over this asset. So again, it is an account balance. Now, whether it has really occurred or not. Now, whether a transaction has really occurred or not. So, occurrence is an assertion for P&L item, that is class of transaction. Completeness is an assertion for P&L item. If possible, just make note of this. I will tell you for class of transactions, what are the assertions, account balance, what are the assertions, and presentation and disclosure, what are the assertions. For class of transactions, occurrence, completeness, accuracy, cut-off procedures, classification. Yes, whether it has been classified properly. For account balance, existence, rights and obligation. Again, completeness will come here also. And whether it is valued properly. So valuation, if an asset is there, whether it is valued, whether it is actually owned by this person only, whether it is really existing, you'll have to go there and see. Physical verification of asset should happen. Obligation is for liability, whether they really have to give the money. For presentation and disclosure, occurrence, rights and obligation, completeness, classification, accuracy, and valuation. It is a mix of both. And if you see, one thing is there in all. Can you guess that? Completeness. Yes, it is there in all the three. Class of transactions, I hope you know, it is nothing but your P&L. Account balance is nothing but your balance sheet. Presentation and disclosure is nothing but your notes to accounts. This is your assertions. I also told you about positive, negative, implicit, explicit, and the assertions that is there. I think I told you in essay 500 also, guys. That's why you are able to say representation made by management and all those points. Yes, guys, where were we? We were under nature of assertion. Inherent risk. What can go wrong? When significant risk is identified, audit evidence solely from analytical procedure is not sufficient. This is what? Don't forget what we are studying. Factors to be considered for substantive analytical procedures. What are the 7 factors? Availability of data, disaggregation, account type. For P&L, you can use analytical procedure, balance sheet, not much. What is the source of data? Predictability, nature of assertion, inherent risk, that is what can go wrong. That means these 7 factors need to be considered by the auditor when he does the analytical procedures. Is that clear? Very, very clear. Samajh gayi, manasilayo, purunjida. Now I'm going on to the next one, that is 7th Roman number, the techniques of analytical procedures. Now you know, as an auditor, you have to consider these factors. Now, how are you going to do the analytical procedures? This is the how part. How are you going to do either of these analysis? You can do trend analysis, ratio analysis, reasonableness test, and structural modeling. Very easy, just be with me. What is this trend analysis? Trend analysis is the most commonly used technique where you are comparing the current data with prior period balance, or you are going to compare the current data with a trend in which 2 or more prior period balances is going to be there. Just see the example directly. The auditor will compare the salary which is paid by the company during the year under audit with the salary paid by the company for several earlier years. There may be some percentage increase in the salary expense over the years. However, any unusual increase, if there is any in that expense amount, which may indicate fraudulent payments are being made to fake employees. Are you able to understand? If there is a sudden increase, then you will get a doubt. Maybe there are fake employees here. You will start thinking like that. This is trend analysis. What is ratio analysis? You're comparing two data like gross profit ratio, gross profit and sales. Like that you're comparing. Yes. Inventory turnover ratio. What are you comparing? Closing stock and sales. Like that you're doing the ratio analysis. This is useful for analyzing asset and liability accounts as well as revenue and expenditure account. An individual balance sheet is difficult to predict on its own, but if you have relationship to one another, then it becomes predictable. Ratio can also be compared over time. Previous year ratio, current year ratio. Now you're going to do a comparison of trend analysis and combination of trend analysis and ratio analysis also. Here can you see? Ratios can be compared over time. Now read the examples. I always tell examples are important because each and every example can become a separate case study itself. Example number 1. Financial ratios may include trade receivable or inventory turnover ratio, freight expenses as a percentage of sales revenue. Yes, that also could be. Example number 2. The statutory auditor can review the GP ratio of the company the year under audit. The company auditor can also further compare the GP ratio with the earlier years. Yes, combination of trend analysis and ratio analysis. Reasonableness test. Unlike trend analysis, this analytical procedure does not rely on events of prior period but upon non-financial data for the audit period under consideration. Example, interest expense against interest bearing obligation. Yes. What they are talking about, reasonableness test, you tell me. There is an interest expense of 1 lakh. Month on month is 1 lakh is going. If there is an interest expense in your balance sheet, there should be a loan amount, correct? Loan amount is 0. Now you automatically have a doubt, for what are you paying the interest? If there is any loan, yes. So you are comparing the interest expense with interest bearing obligation to see whether that interest is actually reasonable, whether you have to make that expense in the first place. Yes or no? The second one is talking about material consumption to production, that is wastage and scrap against production. You are saying 1 lakh worth is wasted. Wastage you are showing in your expense. Now when you go and see, the production itself is not up to 1 lakh amount. The production is only 20,000. How come? That wastage is so much normal loss, abnormal loss, it will keep on going or what? No chance. So reasonable test, it will get captured. Sales discount and commissions against sales volume. Sales discount is given for 1 lakh rupees. Sales volume is 10,000 rupees. How it is possible? No chance. Or sale is 0. Sales discount is 1 lakh. What you gave for free or what? Like that you will be able to ask more questions when you do this type of analytical procedures, that is reasonableness test. What is structural modeling? It is a modeling tool which constructs a statistical model from financial and non-financial data. Say for example, the first year, the salary paid bill was here. The second year here, third year here, fourth year here, fifth year here. Now what should I do? Sixth year, automatically you know that the graph has to come here because it is a structural modeling tool. It is a statistical model with financial data. You are saying that it has to go up only. Now I am saying for raincoat business, in the first half of the year, sale is here. Second half of the year, sale is here. Now in the next year, first half of the year, sale is here. Second half, obviously it is rainy, sale is here. Third half, first half of the year, where should the sale be? Of course it has to be here because the sales trend is like this only. You basically did a structural modeling. It is a modeling tool where you constructed a statistical model from the financial or non-financial data. This will help you to predict the balances. Example, linear regression. These are the techniques which is available to use as substantive analytical procedures. Guys, what are the 4 techniques? Please tell with me. Trend analysis, ratio analysis, reasonableness test and structural modeling. What are the 7 factors to be considered by the auditor? Let me see how many of you all remember. The first one, availability. Yes. Disaggregation, account type, predictability, very good. But before predictability, we saw source, good. Next, nature of assertion and inherent risk. These 7 were factors to be considered for doing analytical procedures. These 4 are techniques available as substantive analytical procedures. Analytical procedures used as substantive test. When designing and performing the analytical procedures, the auditor shall do these 4 things. What are the 4 things? The auditor shall SRED. What is SRED? Determine the suitability of analytical procedure. Whether analytical procedure is really required in this place. Suitability. Evaluate reliability of the data. The data is given to you. Is this data even correct? The reliability of the data has to be evaluated. Develop an expectation and then you determine the acceptable differences. Are you able to understand? Now, when designing and performing analytical procedure, the auditor shall determine the suitability, evaluate the reliability, develop an expectation and determine the acceptable difference. Investigating the results of analytical procedure. Now you've done all the analytical procedures. Now you have the result of analytical procedure. Now with this result, what should you do? In most of the cases, I told you, you yourself tell me, don't see here, don't see the 2 points here. In most of the cases, I told you, when you compare the client data with prior period data, or when you compare the client data with industry data, or when you compare the client data with client determined expected result or auditor determined expected result, whether it is financial or non-financial data, whatever it is, once you compared it and when you knew something was wrong, what did you do? What should be your next step as the auditor? Think as auditor and tell me. You all are going to become auditors. I want you to think as auditors and tell me what are you going to do when you see this difference? You are going to question the management. You are going to ask the management as to why this trend has gone like this. It is going like this only. Suddenly there is a spike here. What is the reason? Like that, you will be able to ask the question to the management. Inquiry of the management to obtain appropriate audit evidence which is relevant to the management's response. Now, after doing inquiry, okay, you ask the management, is the management going to tell the truth? No. What should you do? You will be doing other audit procedures as necessary. So for investigating the results of analytical procedure, there are 2 steps here. The first, you will be inquiring the management, and second, you will be performing other audit procedures if it is necessary. Examples, just read this part. Management is unable to provide an explanation or explanation together with audit evidence obtained is not considered adequate. Simply is giving his own explanation which is not relevant to our audit itself. In that case, definitely you have to do the other audit procedures as necessary. Is that clear? Very, very clear. Yes. Now the last part is talking about the auditor's conclusion. Conclusion in performing analytical procedures. It will help to collaborate conclusion in performing the audit procedures. It helps to draw reasonable conclusion on the overall financial statements as a whole. The result of such analytical procedure may identify a previously unrecognized risk of material misstatement. In case if you do an analytical procedure now and if you find out this place is risky, now what are you going to do? You are going to revise your ROM. That is your risk of material misstatement, and you're going to modify your audit procedures accordingly. Your further audit procedures will be modified accordingly. So here, if the result of analytical procedure is going to identify a previously unrecognized risk of material misstatement, now you're going to revise the ROM and you will modify the FAP accordingly. That is your auditor's conclusion. Is that clear? Now again, from the top, quickly, we are going to revise the entire standard in just 5 minutes. Initially, we started off with meaning of analytical procedure, evaluation of the financial information through analysis of plausible relationship between financial and non-financial data. What are the types? Comparison of client data with 5 things. You can compare client data with industry data, compare client data with similar prior period data, compare client data with client determined expected result, client determined expected result for non-financial data, and auditor determined expected results. What is the scope? We saw the scope. What is it? To obtain relevant and relevant audit evidence, and at the end of the audit also helps you to tell you what is the overall conclusion on the financial statement, whether it is consistent with whatever auditor has understood with regard to the entity. What is the purpose of analytical procedures? Whether they appear reasonable is the first purpose. Then whether unusual events are there, unusual transactions are there, unusual state of affairs are there, unexpected relationships are there. All of this is the purpose of analytical procedure. When can you do? throughout the audit, all stages of audit: planning, testing, completion. 7 factors to be considered: availability of data, disaggregation, account type, source, predictability, nature of assertion, and inherent risk. Techniques available: 4 techniques: trend analysis, ratio analysis, reasonable test, and structural modeling. Analytical procedures: when it is used as substantive test, then the auditor shall read, determine the suitability, evaluate reliability of the data, develop the expectation, and determine if there is any acceptable differences. When I do the analytical procedure, how am I going to investigate the result? I will do the inquiry with the management. I will see whether I have to perform other audit procedures. What is the auditor's conclusion in performing the analytical procedures? It will help the auditor to collaborate the conclusion in performing the audit procedure. It helps to draw reasonable conclusion on the overall financial statements and see whether there is a previously unrecognized ROM. Now, if there is a previously unrecognized ROM, I'm going to modify that ROM and I'm going to do further audit procedures accordingly. Is a clear? SA 520 easy standard is completed. We have done 100% of syllabus coverage of SA 520, guys. I hope you are able to appreciate the standard. Yes, we saw the mind mapping, we went to the concepts, again jumped back to the mind mapping. Now you should have a full picture of SA 520. Is that clear? Yes, give me a thumbs up, guys.
SA 530 audit sampling. Let's quickly see the mind mapping, meaning, objectives, key terms, applicability, characteristics of population. What is the characteristics? CAR, completeness, accuracy, and reliability. What is the meaning of sampling unit? You will already see this in key terms. Again, we will be reading in sampling unit. What are the approaches to sampling? Difference between statistical and non-statistical, sampling versus traditional methods of sampling. What are the factors to be considered for the extent, how deep you have to go to check the sampling plan? What are the advantages of statistical sampling? What is stratification? What is value weighted selection? This only is given in the sample selection methods. The methods are split into two: statistical and non-statistical. Statistical is split into 3: random, systematic or interval sampling, and value weighted sampling or monetary unit sampling. Now this random sampling is again split into two: simple random and stratified random sampling. Here the stratification is nothing but the stratified random statistical sampling. Is that clear? Now under non-statistical, there are two things, that is haphazard and block. Apart from this, in the sampling process, you will be starting from the design, then what size of the sample has to be there, what are the factors which is going to influence your sample size. We will be seeing for test of controls and for test of details. Then what are the audit procedures, how you have to do the audit procedures in case you are not able to do the audit procedures as an auditor, what you have to do. Nature and cause of the deviation. If there is a deviation, should you project it to the entire population? When will you project it? If it is a test of control, will you project? If it is test of detail, if you project. And one more thing called anomaly we saw. Should you project an anomaly? If it doesn't continue, we will not project. If it continues, we will keep projecting. Like that we will keep seeing here. Evaluating the results of audit and sampling risk, and 3 important terms that you will be studying. Is that clear? Now starting off with the meaning of audit sampling. What is the meaning? Audit sampling refers to application of audit procedures to less than 100% of the items which is in the population. Second one is objectives. What are the why you are turning that off? Okay. What are the objectives? The objective is to draw the reasonable conclusion about what? About the population as a whole. First you will draw a reasonable conclusion about the sample and you will project it to the entire population as a whole. The objective is to provide reasonable basis to draw a reasonable conclusion about the population from which the sample is selected. Key terms. There are 4 key terms we saw. The first one is population. Population means the entire set of data. The auditor will be selecting the sample items, the sample units from this entire set of data only. What is the meaning of sample design? You will be considering the design for the purpose of audit procedures. The characteristics of population from which the sample is drawn. What is the meaning of sample size? The number of units which is comprising your sample is called the sample size. This has to reduce your sampling risk. What is the meaning of sampling risk? Sampling risk means what? The risk that that sample is not representative of the population. That is called as sampling risk. Now the sample size is going to reduce the sample risk. How? If you increase the sample size, you will know that it is definitely representative of the population. If you take 90% of the entire population as your sample, that is also possible. Anything less than 100%, if you are doing the audit procedures, that can be your sampling only. So 90% if you take, that means it is more representative of the population. If say you are taking 5%, isn't it less representative of the population? So the sample size should be sufficient enough to reduce this risk that the sample that you've selected is not representative of the population. Is that clear? Next is sampling units. What is a sampling units? These are individual units that you will be picking for doing your audit procedures. But however, these individual units are the units which make up the entire population as a whole. So the first point is talking about how they are making the entire population, and then they will talk about how you will be doing the audit procedures on these samples. Individual items that make up the population. It is a selection from the population that is used as an extrapolation of the population. The conclusion on the population is based on the audit procedures applied on the sampling unit. When you are planning, you will be doing a judgment about the size of the material misstatement. Now, how will you do that? The judgment provide a basis for three things: determining the NET of risk assessment procedure, determining the NET of further audit procedures, identifying and assessing the risk of material misstatement. This point you did not see here, you saw in 315. Applicability of SA 530. When is SA 530 becomes applicable? When the auditor decides to use sampling, that is when this becomes applicable. If the auditor says, no, I will test all items which is there in the population, automatically this SA 530 will not come. So applicability, auditor decided to use sampling, whether it is statistical or non-statistical sampling. If he decided not to use this sampling, then you will be following your other standards. Then we saw the characteristics of population, CAR: completeness, appropriateness and reliability. Completeness means that population which you are picking the sample from must be complete. That means all the transactions must be recorded there. What is the meaning of appropriateness? Appropriateness, you have to select the right item as your population. Here only we saw understatement and overstatement. If the auditor feels that the receivables is understated, then can he use the existing receivables as the population? No. If the auditor feels that the receivables is overstated, can he use the existing receivables as the population? Yes. Why is that the reason? Because if he feels that it is overstated, that means it is 5 lakhs which is given in the books. In reality, it is only 50,000. He feels that it is overstated. In that case, you can do your audit procedures on this to understand what is real and what is that extra which is fake receivable. So if the auditor feels that it is overstated, he can see what is the existing receivables. If the auditor feels that it is understated, that means in books of accounts it is 5 lakhs, in reality it is 5 crores. Then in this case, can I do the audit procedures on this figure? No, I have to do the audit procedures on the subsequent amount which is received and all of those things. Because this figure, if I see, this will obviously say it is true only. I will not know what is in addition to this. So I have to do audit procedures on something in addition to what is already existing. Is that clear? That is the appropriateness of the population that you are selecting to do the sample. That also the data has to be proper. The next is reliable. Whatever the auditor performs audit procedures, then it has to be sufficiently complete and it has to be accurate. It should be trustworthy. That is only the reliability. When will the reliability increase? The reliability will increase when? In SA 500, we saw when reliability increases. When the information is obtained from external sources, when it is obtained directly by the auditor, when it is in the documentary form, when it is in the original document and when internal controls are operating effectively. In these 5 cases, you will say that the data which is given is reliable. That means it is trustworthy. These 3 points are for what? Completeness, appropriateness and reliability is for characteristics of a population. For that only I said remember that as CAR. Characteristics, that also CAR is there. So like that you remember. Next is sampling unit. In the key terms we saw what is sampling unit. The individual items which make up the population is called as sampling units. The population will be divided into different sampling units, and audit procedure will be done on this sampling unit, which is basically extrapolated to the entire population as a whole. What are the approaches to sampling? There are 2 types of sampling, statistical and non-statistical sampling. Now quickly I will just go off to methods of sampling. Yes, sample selection methods. Now under these methods we have 2 types, that is statistical and non-statistical. Under statistical we have random, systematic or interval sampling and value weighted sampling. Under non-statistical we only have 2. We have haphazard and block sampling. Please be with me. Try to recollect the points if you already remember. If you don't remember, at least learn now. Under statistical, how many are there? Random, systematic or interval, value weighted. Under non-statistical, how many are there? Haphazard and block. What is the meaning of random sampling? Under random sampling, again there are 2 types. Simple random sampling and stratified random sampling. Simple random sampling means in the overall population I am just picking up randomly. The keyword that you have to use is random number table list. In Excel there is a formula to generate a random number. You can generate random number between 1 to 100, 1 to 1000. If there are 10,000 items in the population, 1 to 10,000 you can do. Or in Google we saw, what did we do here? Oh, Wi-Fi is not there. You can try this random number generator. Then if you give the minimum and maximum number, between those the random numbers you can keep generating. If you feel like sample size is 10 times you just have to click the button. There is no bias involved. Yes or no? Even though it is random, there is no bias involved. That is why in statistical there is no bias involved. Here in non-statistical, there is some kind of a bias which is involved. In random sampling, there are 2 types. Simple random sampling, for that the keyword that you have to remember is random number table list. What is the meaning of stratified random sampling? In the population, you are first splitting them into different segments and you are making sure that you take the sample from each of the segments. Say for example, you want to see what is the pass percentage. How will you see that? The pass percentage of ICA. How will you see? On sampling basis I want to see. Can I take only people from the south, people from this class? And can I see the pass percentage? No. Can I see people only from north? No. I have to make sure that I take from south, I take from north, I take from east, I take from west, I take from the central part also. So now I have first divided into 5 different stratas. Now from each of the stratas, I will just take 100 students for my sample. Now I have 500, that is my sampling. That is my sampling unit. 500 is my sample size. But each of the units there is the sampling unit, yes or no, which make up the population as a whole. Now this 500 students I am going to take from different parts. So I know that the pass percentage all over India is correct or incorrect. So what did I do here? I first divided into different segments, that is different stratas. Stratified sampling, dividing the whole population to be tested in a few separate groups called strata and taking a sample from each of them. Each stratum is treated as a separate population and if proportionate of items are selected from each of these stratums. For a company usually in monetary value they will be splitting the stratum. How they can split through monetary value? Say trade receivables is ranging from 1000 rupees to 1 crore rupees. Now if I have to pick sample through simple random method, there is a possibility that I will take only in thousands. There is a possibility that I will take only in crores. That is also wrong. I have to take a mix of everything. So first I will split them into 3 segments. Thousands, lakhs, crores. Like that I will split them into 3 segments and then I will try to pick from that. Or I will say 0 to 50,000, 50,000 to 1 lakh, 1 lakh to 5 lakh, 5 lakh to 10 lakh, 10 lakh to 1 crore. Like that I will split into different segments and then I will pick from each of the segments so that I know that the sample that I've selected is actually representative of the entire population. Here trade receivables, they are dividing into 4 groups. Excess of 10 lakh, 7 lakh 75 to 10 lakh, 5 lakh 50 to 7 lakh 75, 2 lakh 25 to 5 lakh 55. The stratified sampling is simply an extension of simple random sampling, because here also it is random only. The stratified random, what you are doing, you are splitting into different segments and randomly only you are picking from each of the segments. What is interval sampling or systematic sampling? What is the meaning of this? Now say the population is 1000, sample size is 100. What should be the interval? The interval should be 10. How did we find that out? 1000 divided by 100. So you found out that the interval was 10. The first number that you are selecting should always be lesser than the interval. So what is the number? 5. Next number, what is the interval? 10. 5 plus 10 is 15. 15 plus 10 is 25. 25 plus 10 is 35. Like that you can keep on going. But first number, you could have selected 2 also. Then it will go as 2, 22. 12, 22, 32, like that it will keep going. You can select as 9 also, 19, 29, like that it will keep going. So the first number is the random selection that you are doing. Actually in interval or systematic sampling also there is some kind of a randomness which is involved here. Even though the name does not say, there is some kind of randomness. What is monetary unit sampling? Here based on the weights you will be picking the sample. That means, say for example in south, north, east, west and central we split for SARC, NARC, like that, correct, to pick up the students. Say for south students there are limited number of students who are taking up the CA course. Say from north there are so many students who are taking up the CA course. Yes or no? That is the real truth also. So is it correct for me to take 5 people here, 5 people there, 5 people here, 5 people? We took 100, 100, 100, 100. Is it correct for me to do that? No. I have to see what is the proportion of the south students to the total number of students in India. What is the proportion of north students to total number of students in India? And based on that proportion, if I decide to take 500 as my sample size, I have to split it based on that proportion. That is only monetary unit sampling. For example, if there are transactions, 50 transactions, 30 transactions, 100 and 20 transactions, what is the weights that you will be assigning? Weights. 0.5, 0.15, first one is 0.25, then 0.15, 0.5 and 0.1. Total is 1. Total is 1. Yes. Now if I decide that I have to take 20 is my sample size, how many will I take? 5, 3, 10 and 2. Like this I am taking 5 units from this segment, 3 units from this segment, 10 units from this segment, because the population in this segment is high. So I will make sure that the sample from this segment is also higher. That is monetary unit sampling or value weighted sampling. Is that clear? Now these 3 are what? Value weighted, systematic and interval and random sampling are what? They are statistical sampling. That is, they are based on some scientific evaluation. That is, there is no bias in terms of statistical sampling. What is the meaning of haphazard sampling? There is no structured technique and there is some kind of a bias which is involved here. That means I will not select any item which is difficult to locate. I will not always select the first page. I will always select the middle few pages. Like that, if the auditor is showing a pattern, then the management will obviously not do the fraud in the middle few pages, because he knows that you are going to select that only. So this haphazard sampling is that the auditor selects the sample for not following a structured technique. Although no structured technique is used, the auditor will nonetheless avoid any conscious bias or predictability. Haphazard sampling has no structured approach. It does not involve judgment and does not use the random number table list. What is the meaning of block sampling. You might get confused between the stratified and the block sampling. They are completely different. Block sampling means you are taking one segment from that entire population and that segment itself becomes the sample. Say for example, there are 1000 pages in the transactions. For the transactions, there are 1000 pages of journal entry. The auditor is going and picking the middle 20 pages, and in those 20 pages he is doing the audit procedures. He is basically selecting a segment and doing the audit procedures on the segment. In stratified, we did not do that. We split into different segments and we took the sample from different segments. Here he is taking a segment and considering this segment itself as the sample, and he is doing the audit procedures on this segment. That is the block sampling. That is, this method involves selection of blocks of contiguous items from within the population. Block selection cannot ordinarily be used in audit sampling because most populations are structured and have similar characteristics to each other. Yes or no? If I want to know about this class, if I only ask the last benchers, they all are friends. They all will tell the same opinion. If I only ask the first benchers, they are all very good people. So they will give the same opinion. They are all like, ma'am, எங்களை பத்தியா மேம் பேசுறீங்க பெருமையா இருக்கு மேம். Like that, if I want to really know about the class, few people from first row, few people from last row, few people from the middle row. Middle row is the best row, you know. Middle row is the bestest. They are such confused people. They don't know whether they have to mingle with the first row people also. They don't know whether they have to enjoy with the last row people also. They are in a fully confused state. I was also middle bench only. That is the best one. Actually, there is a balance. There should be balance in life. The middle people are the balanced people. They will not have too much fun. They will not be too serious like the first row people. They will be somewhere in the middle. But in life also, don't be in middle itself. Somewhere you should go. Yes or no? All the middle benchers. Decide something that you either have to have fun or you have to be serious. Rudra is saying, ma'am, you are saying I am having fun. I will show you, ma'am. I will get that 70 plus in auditing. Yes? Yes, it is possible. It is definitely possible to get 70 plus. Everybody has the capacity to get 70 plus in auditing. And next is what? Where did we leave, guys? Block sampling. We are done with the methods of sampling. Quickly, I'll go to the mind mapping. What and all did we see? We saw the meaning. We saw the objectives. We saw the key terms. When is it applicable? When the auditor decides to use sampling, SA 530. If it does not decide to use sampling, any other standard, you please go to that. Characteristics of population CAR. What is the meaning of sampling unit? Approaches to sampling. Did we do that? Statistical and non-statistical. We are yet to do the approaches and difference between statistical and non-statistical. Quickly, let's do the approaches. Approaches to sampling. Statistical sampling and non-statistical sampling. A sampling approach. Characteristics of statistical sampling. An approach to sampling that has the random selection of the sample items. What is the meaning of random selection? Under statistical, we saw 3 points. Random, that is obviously random. The second one was systematic or interval. There also there was some kind of randomness. What was the randomness? The first number that you are selecting is a random number. The third one is what? Value weighted sampling. Okay, you decided that you have to select 5 from this segment. You have to select 10 from this segment. How are you going to select that? Random. So there is some kind of randomness in the statistical sampling. But they are using probability theory. The probability theory is for evaluating the sampling results and for measurement of the sampling risk. For this, there is probability theory, that is characteristics of sampling. Characteristics of statistical sampling. What is non-statistical sampling? Any sampling approach which does not have these 3 features are called as non-statistical sampling. Difference between statistical and non-statistical sampling. Which one is having more probability? Statistical is having more probability. Which one is based on bias? Statistical, not bias. Non-statistical, there is some kind of a bias involved. Which one is more accurate? statistical, non-statistical is not accurate. Which one is based on scientific evaluation? Statistical is based on scientific evaluation. Non-statistical is not based on scientific evaluation. For large population, which one can you use? Statistical can be used for large population. Non-statistical you can use for small population. Which one is more representative of the population? Statistical is more representative of the population. You are exactly able to tell statistical or non-statistical because I asked you what is the basis. So these 6 points you have to remember. Can you say those 6 points? Probability, bias, accuracy, scientific evaluation, population and representative of population. Again the 6 points. Probability, bias, accuracy, scientific evaluation, population, whether it is representative of the population. If you know these 6 points, easily you will be able to put it into each dabba, whether it is statistical or non-statistical. Sampling versus traditional methods of sampling. The evidence which is available is not conclusive and the auditor always takes a calculated risk in giving his opinion. Even if you do 100% of the audit procedures, you cannot be sure that 100% that it is free from error or fraud. Yes or no? Even if you stay with 1% for 30 years, can you know 100% about the other person? It is never possible to know 100%. Maybe 99.999%. It is possible for you to know, but that 0.1% you will never know. And nobody is constant. They will keep changing. Change is the only constant. So can you predict how they are going to change? It is not possible. So even in sampling, even if you do audit procedures on 100% of the population, you cannot derive the absolute satisfaction. So there is some kind of a calculated risk that you have to take when you are giving the opinion. By adopting the sampling technique, the auditor only checks a part of the whole mass of the transactions and he puts the reliance on the internal controls and checks with the client organization because they provide the reliability of the records. If the internal control is satisfactory in the design and implementation, a smaller sample can give necessary reliability of the result he obtains. On the other hand, if certain areas controls are slack and not properly implemented, auditor may have to take a much larger sample. What they are talking about internal control in the last 2 points. If the internal control is strong, then you can reduce the sample size. If the internal control is slack, that means it is weak, then you have to increase the sample size because the internal control is basically telling you whether you can rely on the data or not. Yes or no? If you see that whatever data is entered by a specific person, they have an internal control. By that specific person is not entering. Somebody else is also having access to the computer. Now can you rely on this data fully? You cannot rely on the data fully. If reliability is low, the sample size will automatically increase. So the base is the internal control. If the internal control is strong, you can reduce the sample size. If the internal control is weak, you have to increase the sample size. This is Roman number 9, sampling versus traditional methods. What are the factors to be considered for the extent of checking on the sampling? That means how deep I have to go and do the audit procedures on the sampling. Size of the organization under audit. Say for example, 10,000 transactions are there. How much sample size will be there? Sample size will be 100. Okay. Say 1 crore transactions are there. What will be your sample size? It can be 500. It can be 1000. It can be 100 also. But what we read there was it will not be directly proportionate to the increase. Here what was the percentage that you took? 1% is what you took as 100. Now if it is 1 crore, what is 1% of 1 crore? 1 lakh. You will not be taking 1 lakh. That is what we read there. The sample size will still increase, but the sample size increase will not be directly proportionate to the increase in the population. That is what we saw. But don't always say 100 only. sample size 100 na, wherever it goes it is 100 only, not necessary. It can be 500, it can be 1000, but not necessary that it has to be 1% of 1 crore again. So it is not the same proportion. The percentage change increase can vary. That is the whole point. So the size of the organization is going to determine the extent of checking on the sampling. The state of internal control: if your internal control is strong, your sample size can reduce. The internal control is weak, your sample size will increase, so your depth will increase. Adequacy and reliability of the books and records: you can trust the books of accounts, then your sample size will reduce. If the reliability is not there, your sample size will increase. Tolerable error range: if there is a mistake which happens, I can tolerate it, that means it is not important. If it is not important, when my sample size can reduce. Degree of desired confidence: I want to give full confidence in this area, then in that case it is important. That is the reason why I want to give the confidence. If it is important, my sample size will increase. So this is basically the factors which is telling me the depth I have to check the sample. So if the sample size is increasing, my depth is also increasing. Is that clear? So what are the factors? There are 5 factors: size of the organization, state of the internal control, adequacy and reliability of the books and records, tolerable error range, and degree of desired confidence. What are the advantages of statistical sampling? The amount of testing does not increase in proportion to the increase in size of the area, that is the population which is tested. For this only I told you, if there are 10,000 transactions and if the sample size is 100, if the transactions become 1 crore, the sample size need not become 10 lakhs. The sample size can be 500, the sample size can be 1000. So the percentage change of the sample size need not be directly proportionate to the percentage change in the population. Is that clear? So the first point is talking about the amount of testing does not increase in the same proportion to the increase in size of the population. The sample selection is more objective and thereby more defensible. This method provides a means of estimating the minimum sample size associated with specific risk and precision. This gives a calculated risk. It may provide better description for large masses of data. It is widely accepted, it is more scientific, no personal bias, and it can be evaluated and projected in a more reliable way. So many are the advantages of statistical sampling. About 10 points are here. We are done with advantages, we are done with differences, we are done with factors to be considered, sampling versus traditional methods of sampling. Now quickly we will see this part also, stratification and value weighted, because we are already done with the methods of sampling, and then we will go to the 13th Roman number, that is a sampling process. Stratification and value weighted selection. This stratification is nothing but your stratified random statistical sampling. Yes, keeping that in mind, read the text. Audit efficiency may be improved if auditor stratifies a population by dividing it into discrete subpopulation which have identifying characteristics. Objective is to reduce the variability of items within the each stratum and allow the sample size to be reduced without increasing the sample risk. This is basically to reduce the sample risk. You will be dividing into different stratums and picking the sample from each of the stratas. This allow greater audit effort to larger value items, as these items may be overstated. Results of sample drawn under each subpopulation are projected to that stratum. What they are saying, you are dividing into different segments. Now for south, I took 100 students. Now based on this 100 students, I am going to extrapolate it for this segment of south. Similarly for north, based on that 100 students, I am going to tell the pass percentage for north. Then finally I will be adding everything up. I will not be taking the directly to the population. I will not be extrapolating directly to the population. I will directly extrapolate to the subpopulation. Again next I will extrapolate to subpopulation. Like this 5 times I will do, and then I will add all of that, which is the conclusion. The results of sample which is drawn under each subpopulation is projected to that stratum, that is a segment, to draw an opinion on the overall population, combine the results of all the stratums to check for any deviation or risk of material misstatement. When you can use deviation, when you can use risk of material misstatement, whenever the internal control is not operating effectively, you will be using the deviation. Whenever the account balance class of transaction is materially misstated, you will say that risk of material misstatement. Is that clear? So deviation is always for internal control, risk of material misstatement is always for test of details, that is account balance class of transaction disclosure. Projected misstatements of each stratum will be combined to consider the possible effect of the misstatement. What is value weighted selection? When performing the test of details, here they spoke about test of control and test of details. Here they are only talking about test of details. When performing the test of details, it may be efficient to identify the sampling unit as individual monetary units that make up the population as a whole. You will be selecting specific monetary units within the population. One benefit is that audit effort is directed to larger value items. In our example, we took 20 from the segment where the population was higher. So larger value items, you will be devoting more time because they have a greater chance of being selected and can result in smaller sample sizes. This approach may be used in conjunction with the systematic method of sample selection and is most efficient when selecting items using the random selection. Going to the sampling process, that is the 13th Roman number. Under this we have sample design, sample size, sample selection methods, what are the audit procedures, nature and causes of the deviation, projecting the misstatement, and evaluating the results of the audit. What is the meaning of sample design? Sample design. How you are going to pick the sample. When designing the audit sample, the auditor will consider what is the specific purpose which is to be achieved and whether I have to do it with a combination of other audit procedures, like should I do it along with inquiry, should I do it along with observations, that is likely to best achieve that purpose. Now what is the purpose which is to be achieved? You are going to see the overstatement of receivables. What should you see at this point? You should see the existing receivables at this point. So what is the purpose, whether it is overstatement, whether it is understatement, based on that you will be designing your sample. Consideration of the nature of the audit evidence sought and possible deviation or possible misstatement condition. Again, possible deviation is for internal control deviation, possible misstatement is for test of details, that is your account balance class of transaction misstatement, or other characteristics relating to audit evidence. In fulfilling the requirements of SA 500, when performing audit sampling, the auditor performs audit procedures to obtain the evidence that the population from which the audit sampling drawn is complete. The first point is talking about what is the purpose and whether it is using other audit procedures. Second point is talking about how the audit evidence is going to be. Third is talking about how the audit procedures are going to be put. Sample size. This should be sufficient enough to reduce what? To reduce the sampling risk. So for test of controls and test of details, I will give you a few things. You tell me whether sample size will increase or reduce. If internal controls are operating effectively, then your sample size will increase. The expected rate of deviation is high. Sorry? Internal controls are operating effectively, sample size will reduce. Yes, correct. Expected rate of deviation is high, then sample size will increase because you are expecting a deviation in the internal control. So you have to increase your sample size. If you want to give more assurance, then sample size will increase. If your tolerable rate of deviation is high, you can tolerate a mistake happening here. That means it is not important, so your sample size will reduce. If there is a change in sample units, you are not able to do the sampling, so you are changing the units. So how much should you increase or reduce? There will not be any change. There will not be increase or there will not be reducing. This is for test of controls. For test of details, again, if you have to give more assurance, your sample size will increase. If the risk of material misstatement is high, your sample size will increase. If the expected misstatement is high, the sample size will increase. If you are doing other substantive procedures also, your sample size will reduce, because if you are relying on other substantive procedures, here you can be little free, here you can be little easy. So here it is not material. If it is not important, you will be reducing the sample size when you rely on other procedures also. Your tolerable rate of deviation is high. Your sample size will reduce because you can tolerate a misstatement happening here. That means it is not important, so you can reduce. If the change in sample units happen, again there won't be any change. You don't have to increase or reduce for change in sample units. That only is the examples of factors influencing is given here. We are done with the methods. Going to performing the audit procedures. How you will be performing the audit procedures? If you are able to do the audit procedures, then you will be obtaining the sufficient appropriate audit evidence. If you are not able to do the audit procedures, then you will have to replace the sample. You will take a replacement sample, and on that you will try to do the audit procedures. If you are able to do the audit procedures, then you will obtain the sufficient appropriate audit evidence, no issues. If you are not able to do on the replacement sample also, then in that case, you will go for alternate audit procedures. In that alternate audit procedures, if you are getting any kind of audit evidence, then no issues. You will get the sufficient appropriate audit evidence. But alternate audit procedures also not possible. Then what should you do? You will conclude that there is a deviation in the test of control, or there is a misstatement in the test of details. For that only we saw audit procedures. If you are able to perform, then you will do the audit procedures, you will get the sufficient appropriate audit evidence, you will be giving the opinion, you will, based on the conclusion, you will be giving an opinion, yes or no. If you are not able to do the audit procedures, then you have to do the audit procedures on replacement sample. In the replacement sample, if you are able to do the audit procedures, then you will get the sufficient appropriate audit evidence. If you are not able to do in the replacement sample, then alternate audit procedures. Then in the alternate audit procedures, if you are able to do sufficient appropriate audit evidence, you will base the conclusion and give your opinion. Alternate audit procedures also not possible. If it is test of control, that is internal control, you will conclude that there is a deviation in the internal control. If there is test of detail, you will conclude that the ABC is misstated. You understood? That text only is given here, performing the audit procedures. What are the nature and cause of deviation and misstatement? Here you have to see whether there is some kind of a common feature which is there, because of which the deviation or misstatement has happened. Now what is that common feature? It can be because of a location, because of a product line, because of a period, because of a type of transaction. All of these can be a common feature as to why a deviation is happening in internal control or a misstatement is happening in the test of details. In such circumstances, the auditor may decide to identify all the items in the population that possess the common feature, and then he will extend the audit procedures on all those items. So basically, if you figure out that there is some kind of a deviation or misstatement, you will see whether there is a common feature. If there is a common feature, you please find out all the transactions which is having the common feature. Now on all of this, you will be doing your audit procedures. In addition, such deviation or misstatement may be intentional and can be a possibility of fraud. In that case, the auditor will investigate the nature and causes of any deviation or misstatement which is identified, and then they will evaluate their possible effect on the purpose of audit procedures and on other areas of the audit. Projection of the misstatement. If there is any deviation in the internal control, you cannot project it to the population. If there is a deviation in the test of details, you will be projecting to the entire population except for anomalies. Anomaly means one-off incident. ஒரே ஒரு தடவை தப்பு பண்ணிட்டேன் மன்னிச்சிரு அப்படின்னு கேட்டா you will say okay. So anomaly means one-off incident. So here projection of the statement. Why for test of control you cannot project it to the entire population? Because if you say take an item like fixed asset, there will be hundreds of internal controls. For the existence of the asset, there will be. For occurrence of that asset there will be. For the valuation of that asset, there will be. For entering the journal entry, there will be one control. There will be multiple internal controls. For you to take the sample and extrapolating that deviation to the entire population is not right. That is the reason why for internal control, you will not be projecting to the entire population. If it is a test of detail, you can project except for one-off incidents, that is anomaly. Now, if the anomaly keeps on continuing, then in that case, you will be projecting because it is no more an anomaly. But if that anomaly does not continue, that means it is really a one-off incident, then in that case, you will say it is okay, you will not project. The auditor is required to project the misstatement from the population to obtain a broad view of the scale of misstatement, but this projection may not be sufficient to determine an amount to be recorded. When misstatement has been established as anomaly, it may be excluded when projecting the misstatement to the population. However, the effect of any such misstatement, if uncorrected, that means anomaly keeps on repeating, still needs to be considered in addition to the projection of the non-anomalous misstatements. That means what they are saying, if for test of details, you will be projecting it except for anomalies. Now you have to see whether this anomaly is continue or not continuing. If it is continuing, you please project it. Along with all the non-anomalous transactions, you please project it. If it is not continuing, then you don't project it. For test of details, the auditor shall project the misstatements found in the sample to the population, whereas for test of control, no explicit projection of the deviation is necessary, since the sample deviation rate is also the projection deviation rate for the population as a whole. How are you going to evaluate your sample results? The auditor shall evaluate the results of the sample and whether the use of audit sampling has provided a reasonable basis for the conclusion about the population. Where did we see this? In the objective, we saw that to draw reasonable basis, to draw the conclusion about the population. That only is the conclusion also. Evaluation of the sample result, whether use of the sampling gives a reasonable basis for conclusion about the population. The same thing which we saw as objective is flowing through as the conclusion as well. The last part is talking about sampling risk. What is the meaning of sampling risk? Risk of the sample being not representative of the population. Now, sampling risk can be because of test of controls and risk of incorrect acceptance. Now, we'll finish off this part, risk of incorrect acceptance. Now, you all tell me, risk of incorrect acceptance means what? That the financial statements are actually misstated, but the auditor has accepted that financial statements which are misstated. That means auditor has given an unmodified report. Auditor is saying everything is clean here, but in reality the financial statements are actually wrong. What is this called? This is called as audit risk. What is audit risk? The risk that auditor gives an inappropriate audit opinion when the financial statements are materially misstated. So here the risk of incorrect acceptance leads to audit risk. Risk of incorrect rejection, that means financial statements are correct, but the auditor is rejecting that financial statements. The risk of incorrect rejection, is this audit risk? No, this is not audit risk. You have to remember, risk of incorrect acceptance is audit risk. Risk of incorrect rejection is not an audit risk. For test of controls, whenever there is internal control, say internal control is operating to a particular level, but we have doubts about that internal control. We are not trusting on that internal control. So what will we do? We will be wasting more time doing so many other audit procedures, getting the audit evidences. We will be wasting lots of time. Time means efficiency. That means it affects the efficiency. Risk of under reliance means internal control is operating to level 100, but we are having trust issues. We are thinking that level 20 also it has not crossed. In that case, it affects your efficiency. Efficiency means time. Risk of over reliance. Internal control is operating to 100, but we are thinking that it is operating to 500 level. So this is over relying. So will I be doing the audit procedures properly? No, I will reduce the sample size. I will not do other audit procedures. In that case, it affects the effectiveness itself. Effectiveness means the quality of the audit, it gets affected. Efficiency means the time of your audit increases. So test of controls risk of over reliance and risk of under reliance. Risk of over reliance affects the effectiveness and risk of under reliance affects the efficiency. Is that clear? This is sampling risk. What is non-sampling risk? Doing the wrong audit procedure. In the case where I have to do external confirmation, I am just doing the inquiry with the management. It is a wrong audit procedure, that is the non-sampling risk. Misinterpretation of audit evidence, inappropriate audit procedures, or there is some human mistake, misinterpreting the sample results, relying on some wrong information itself. Anything other than the sampling risk, we will be calling that as non-sampling risk, where the auditor has made a mistake. Important terms, there are three important terms which is given here. What is the meaning of stratification? Dividing the population into different subpopulations, each of which is a group of sample units which have similar characteristics. What is tolerable misstatement? Tolerable misstatement means what? That even if there is a misstatement which is happening there, the auditor feels that it is alright. So a monetary amount which is set by the auditor, in respect of which the auditor seeks to obtain an appropriate level of assurance, that monetary amount set by the auditor is not exceeded by the actual misstatement. That means actual misstatement must always be lesser than how much I can tolerate. So they are saying it should not exceed the actual misstatement. That means it should be lesser than the actual misstatement. What is tolerable rate of deviation? Now here this tolerable misstatement is for account balance class of transaction. That is your test of details. This tolerable rate of deviation is for test of controls, for internal controls. A rate of deviation from the prescribed internal control procedure set by the auditor, in respect of which auditor seeks to obtain appropriate level of assurance that the rate of deviation set by the auditor is not exceeded by actual rate of deviation. That means actual is lesser than the tolerable rate of deviation. Is the same concept, just that the terminology here used is misstatement, here the terminology which is used is deviation. That is the only difference. Is that clear? With this essay 530, have we completed everything? Essay 530 comes to an end. Yes, we have completed all of this.
Now I'm going to start off with essay 580, that is written representation. This is one of the most easiest standard, one of a very small standard also, interesting standard. So let us get into that. Usually we'll see the mind mapping first, correct? So here the mind mapping is a little different, because if you see the objective of the auditor for essay 580 written representation, there are 3 points which is given. That objective itself becomes the mind mapping. Before I get into all of those things, the name and number of the standard essay 580 written representation, I hope you will not make a mistake there. We will be starting off with meaning of written representation. Basically, what is this written representation? Who is writing to whom? Basically, the management is writing a love letter and the management is going to give it to the auditor. A written representation is basically a management writing something. That what is that something we'll be studying here in this essay 580 standard, and that written representation will be given by the management to the auditor. Now the auditor's duty is to get the written representation from the management. I am just telling in active voice, passive voice, nothing different till here. Now this essay 580 is talking about, as an auditor, I have to get the love letter from the management. Now what and all should be in that love letter? For what are the reasons I can get a written representation from the management? All those things we will be seeing in essay 580 written representation. Now the objective of the auditor has 3 objectives with respect to this standard. The first one is to obtain written representation. He will be obtaining for 2 reasons. One is saying that I have prepared and presented the financial statements properly. Who has to prepare and present the financial statements? The management has to prepare and present the financial statements. Get your basics really clear. In SA 200, I told you preparation and presentation of the financial statements, the duty is that of the management. So here, when you're getting the written representation from the management, the first point for which you can get the written representation is whether it has been prepared and presented appropriately. Whether it is done on accrual basis, whether it is done on cash basis, you please get it done again from the management. Ask him to write, yes, I have prepared it properly. Now he has given the data. Based on that data, we auditors are going to do the audit opinion. We are going to give the opinion on the financial statements, yes or no. Now that data which is given by the management has to be complete in nature. For that also we have trust issues. Auditors, we always have trust issues. So we will go to the management and say, hey, you gave me the data, but you also give me another letter saying, yes, I have given the complete data of all the financial statements. Whatever I have given, that only is complete. Nothing more than that is there. Like that, you please get it written and signed by the management and given to the auditor. That is only the written representation. The first part is talking about to obtain the written representation. And remember, when you are getting the written representation, it will be for two reasons. First one is for the preparation of financial statements. The second one is whatever information is provided that is complete in nature. Are you able to understand? That is written representation about management's responsibility. That is the first objective of the auditor with respect to SA 580. What is the second objective of the auditor? Now I have an audit evidence. I did audit procedures. I have an audit evidence. I want to support this audit evidence. For that, I will ask a love letter from the management. Now I got the audit evidence. I also want you to confirm that whatever audit evidence I have received is correct. So you please write a love letter to me. Write it and sign it so that I will trust it more. So to support an audit evidence, also the written representation can be used. This standard is also talking about how the auditor has to respond. Now I receive the written representation, whether I can rely on this written representation or I never receive the written representation after asking the management also. Now how should I respond as the auditor? That is the third part. For now, you park the third part aside. We will only focus on the first two. The first one is talking about to obtain the written representation about management's responsibilities. I already told you, management's responsibilities are of two. The first one is the preparation of financial statements, and second is whatever information is given, it is complete in nature. Why is written representation about management's responsibilities necessary? This is because the auditor is not able to judge solely on other audit evidences whether management has prepared and presented the financial statements and provided info to the auditor on the basis of the agreed acknowledgement and understanding of the responsibilities. Now, the management is supposed to give the financial statements. The management is supposed to prepare and present the financial statement and provide all the information to the auditor based on the responsibilities agreed. Where did they agree the responsibilities? As part of the engagement letter itself, they have agreed the responsibilities. Yes. Now the auditor is not able to judge based on the evidence that whether the management has prepared and presented the financial statements as per the terms only. In that case, I will ask them for written representation. In every case, will I ask them for written representation? No. When I have doubts about these four things, I will ask for written representation. Now we have given a combination standard. Now we are actually in SA 580. I have taken you to 210 because here they're talking about agreed acknowledgement and understanding of the responsibilities. This understanding of responsibilities happened in SA 210. Now come to the next 4 points. This is particularly appropriate when the person who signed on behalf of the entity no longer has the relevant responsibilities. Now you all should have asked me this doubt. Ma'am, in 210 itself, that person signed the engagement letter. That time itself, he told this is my responsibility. That is your responsibility. We have drawn a border. This is a boundary. Yes, Gen Zs. Boundaries are very, very important. I will not cross. You also don't cross. Like that, everything was done as part of SA 210 itself. Now why again, ma'am, we have to do it? That question should come to your head. Now, the person who signed the engagement letter, he left the organization and went. Now, another person is there in his place. To him, you are going and asking, sir, someone in your place signed. Now your company only signed. Now you know this is your responsibility. You please fulfill your responsibilities. That person is going to be like, who is this person? I don't know who signed for you. Now that person left or that person got promoted or he is no longer responsible for this job. Now we have to reiterate to the person who has that kind of responsibility to tell us, yes, I understand my responsibility. I have prepared and presented the financial statements as per my responsibilities only. That is the first point. The person who signed the terms no longer have the relevant responsibilities. The second point is talking about they signed it in the previous year. In the current year, they didn't sign anything. Now, when you go to the client and ask, they are going to be like, hey, last year is gone. Last year, I don't know what I signed yesterday itself. You are asking some years back, 365 days back. I don't have any answer for all of these things. Like that, client should not tell. We have to be extra careful. Auditors have trust issues. I already told you. So when the terms are prepared in the previous year also, it is appropriate for the auditor to get a written representation with regard to the management's responsibilities. There is an indication that the management misunderstands those responsibilities. That person only signed, that person is still there, but the auditor feels that he did not understand properly. Then in that case also, you can ask him for a written representation saying he has understood his responsibilities properly and whatever data he is giving is complete in nature. Any changes in circumstances make it appropriate to do so. Say, for example, there is a merger or there is a demerger, there is a change in circumstance, leadership completely changed, board of directors quit the organization and left. Any change in circumstances, if it happens, then it makes the auditor appropriate to get the written representation from the management saying that they have fulfilled these duties with respect to preparation of the financial statement and whatever information provided is complete in nature. Are you able to understand? So in these four circumstances, it becomes appropriate for the auditor to get that love letter from the management. Management responsibility will be described in the written representation required about management responsibility in the manner in which the responsibility is described in the terms of the audit engagement. Where is the terms given? In SA 210 engagement letter, the terms have been signed already. In some cases, now the management is going to sign and going to give the love letter. So the management will make inquiry with few individuals who are having specialized knowledge with respect to the written representation which is requested. Who are these individuals is given here. It could be an actuary, it could be a staff engineer, or it could be an internal counsel who is giving all the information which is regard to the legal claims. So the management is going to talk to these three people and then only give the written representation. Always we see that auditor will be making the inquiry. Here it is said that management may decide to make inquiry of those who participate in the preparation and presentation of financial statements. Now these individuals could be an actuary or a staff engineer or an internal counsel. Is that clear? Very, very clear. Now I'm going to just brush you through the first part and then move on to the second part. The first part is talking about how the auditor is going to obtain the written representation from the management. Now this will be regarding two things. That is, the first one is preparation of the financial statements itself, that basically the management, whether they have understood their responsibilities properly. Second, whatever information that they have given, whether it is complete in nature or not. Now already all of these has been spoken in SA 210 when you are signing the engagement letter itself, but still it becomes appropriate when the person who signed no longer responsible right now. The signing happened in the previous year, or the person who signed did not understand his responsibility properly, or any change in circumstances where the auditor feels that it is appropriate to get the written representation from the management. In that case, he will be getting the written representation. Now this written representation required about management responsibility should be in the manner as per the terms only. Now when the management is giving the written representation, management will be making the inquiries of others who are participating in the preparation and presentation of the financial statements. This inquiry will be made to the individuals who are having specialized knowledge. Who are these individuals? It could be actuary, it could be staff engineers, or it could be internal counsel. Is that clear, guys? Yes? No? Are you all clear? Good. Now the second one is to support other audit evidences. What is supporting other audit evidences? Now I already got one audit evidence. To support this, I am going to ask the management to give me a love letter saying whatever audit evidence I have obtained is correct only. That is the supporting of other audit evidences. Now for what reasons can they get supporting audit evidences? Now this other written representation may supplement but do not form part of written representation relating to management's responsibilities. Very important. That is the reason why it is given in red. Now I'll explain this statement. Be very, very careful. They are saying the second part is talking about other written representation. The first part spoke about what? To obtain written representation regarding management's responsibilities. Now the base of the standard is set very, very clearly. That is, the written representation is about management's responsibilities. Apart from this, if you want to get any other written representation, you can use this written representation also as a supplementary tool. But this will not form part of this representation itself. The first one, the base is separate. The second one is separate if the case requires you to do so. Is that clear? So the other written representation may supplement, but it does not form part of the written representation with regard to the management responsibility, because that is the base of the standard. Now, what this other written representation could mean? It could mean whether selection and application of accounting policies are appropriate. If a specific accounting policy is being used, auditor wants to know whether it is appropriate. Of course, the auditor is going to do all the other audit procedures, but just in case, I will also ask the management to give me a letter saying whatever accounting policy I have used is appropriate in this circumstance only. Like that, I will get a letter from the management so that I'm doubly sure. Yes, that is the first point. Whether matters such as the following were relevant under applicable financial recognized framework have been recognized, measured, presented or disclosed with that framework. Here they're basically talking about assets, liabilities and laws and regulations. What are they talking about? Assets, liabilities, laws and regulations. Now, the auditor wants to see the carrying value of the asset, basically the valuation of the asset, whether it has been done right or wrong. For that, the auditor will be doing multiple audit procedures. He will be doing recomputation. He might even do external confirmation to see the carrying value of the asset. What was the purchase price, whether they have done depreciation properly, what is the carrying value. He would have done all of those things. But he can also get a written representation from the management saying that the carrying value of the asset is right only. Plans or intentions that is going to affect the carrying value of the asset. Title to or control over the asset, that is right over the asset, or if there is any lien or encumbrances on the asset. What is the meaning of encumbrances? Whether there is a charge which is being created on the assets or any asset which has been pledged as a collateral. If it is like that also, we can get a written representation from the management. That is why I said assets, liabilities and laws and regulations. What is it about liabilities? Whether it is an actual liability or whether it is a contingent liability, we can get a written representation from the management. Laws and regulations. Aspects of laws, regulations, contractual agreement that may affect the financial statements, including any non-compliance. If there is any non-compliance, you please write a love letter to me that I have not been able to comply with this statute as on this date because of this reason. Whatever it is, you write some letter, put your signature and give me. Everything is a proof for the auditor. Yes, so the auditor has to be doubly careful, and that is the reason why he will also get other written representation, and that could be with respect to selection application of accounting policy or as per whether everything is as per AFRF. And what is that everything? Assets, liabilities and laws and regulations. With respect to assets, there are 2 points: plans or intentions that affect the carrying value of the asset, and title over the assets, whether there is any lien or encumbrance or whether the asset has been pledged as a collateral. The third point with respect to liabilities, both actual liability or contingent liability, you can get a written representation. The last one is whether laws, regulations, agreements have been properly dealt with, and if there is any non-compliance, you can get a written representation for that as well. Is that clear? Now, when should the date of the written representation be? Multiple times they have tested with respect to the date of written representation. When should the date of written representation be? Now you tell me, if our auditor's report date is on 21st June, that means auditor is giving the opinion on 21st June, signing on 21st June. Can I get the written representation from the management on 30th of June? That is after the date of audit report. Doesn't make any sense, because written representation is basically a type of audit evidence for the auditor. Can the auditor get an audit evidence after the date of audit report? Doesn't make any sense. So this audit evidence always has to be before the date of audit report. Another example, audit report date was on 21st June. Can I get the audit evidence on 20th of June? Signing just one day before that, I'm getting the written representation. Is that okay? Yes. very much okay. As long as it is before the date of audit report, auditor does not have any problem, because written representation is a type of audit evidence only. Yes. So listen here, the date of written representation should be as near as practicable, but not after the date of auditor's report on the financial statements. The written representation shall be for all the financial statements and the periods referred to in the auditor's report. Is that clear? It should not be after the date of auditor's report, but it could be as near as practicable. Is that clear? Very, very clear with the date of written representation. Just remember logically in your head, what is written representation? It is another evidence which the auditor is getting from the management to be doubly sure as to whatever work that he is doing. Now, this evidence should always be before the signing of audit report. If you have this logic in mind, you can answer any question with respect to date of written representation. Yes or no? Now going to the third part. Now if you remember, I told you the mind mapping is the objective of auditor itself. The first part we spoke about as an auditor, on what basis we will be obtaining the written representation. Second, we can also obtain to support other audit evidences, but this will only be supplementary and will not be part of the written representation with respect to management's responsibility. Now I'm going on to the third one, that is to respond appropriately. Now under this, there are two parts. If they have given the written representation, but the written representation which is provided is not reliable. If they have not given the written representation at all, as an auditor, what should we do in these two cases? Now just read this. To respond appropriately for the written representations which is provided by the management and where appropriate TCWG, or if the management or TCWG do not provide the written representation which is provided to the auditor. Now going on to the third part. If provided, he is going to check the reliability. If not provided, what should the auditor do? Doubts as to the reliability. If the auditor has concerns about the doubts of the reliability, then what should he see? He should see what is the effect on the audit evidence that he already has. Now, if it is inconsistent with other audit evidences, one audit evidence is completely inconsistent with another audit evidence, then he has to perform more audit procedures, additional audit procedures. If it is still unresolved, then he will reconsider the assessment and shall determine the effect on the concerns of the audit evidence. Now, if the auditor is going to conclude whatever said and done, completely unreliable fellow, no use, then you use your weapon, you go to SA 705, you give a disclaimer of opinion. Is that clear? Now, if you have doubts as to the reliability, you're going to first see the effects on the audit evidence. Then you're going to see if one audit evidence is inconsistent, if the written representation is one audit evidence. Now, this written representation is inconsistent with another audit evidence that I already have. Then the auditor will be performing audit procedures to resolve this somehow. If the matter is not getting resolved at all, then the auditor will reconsider the assessment and will determine the effect on the audit evidence. If the auditor concludes that whatever written representation which is given is not reliable, that means there is no sufficient and appropriate audit evidence, and now we know that there is a material misstatement and we also know that it is pervasive in nature, then obviously you will be giving what opinion? You will be giving a disclaimer of opinion. Is that clear? Written representation is given, that is an evidence, but it is not reliable, it is not sufficient and appropriate. So if it is not sufficient appropriate, there is a material misstatement and it is pervasive in nature, you will be using a weapon and will be giving a disclaimer of opinion. Clear? Very, very clear, super clear. Yes. Under doubts as to reliability, we saw this. Now, if the written representation itself is not provided, what should we do? If the written representation is not provided, you tell me, is there sufficient appropriate audit evidence? No, there is no sufficient appropriate audit evidence. There is a material misstatement and it is also pervasive. So what kind of opinion will you be giving? Again, you'll be giving a disclaimer of opinion only. If requested written representation is not provided, directly don't use your weapon. First, be polite. Always be polite first. Directly, if you go and pounce on the other person, no, it is dangerous scenario. Be very polite. The first thing you have to do is discuss the matter with the management. Re-evaluate the integrity of the management, and finally you take the action. What is the action? That is your weapon. That is SA 705, disclaimer of opinion. Is that clear? Yes, if written representation is not provided, what are you going to give? Disclaimer of opinion. If the written representation is not reliable, what are you going to give? Disclaimer of opinion. So can I say that in SA 580 written representation, in the third part, if you have to respond appropriately, there were two scenarios. The first one is what written representation is provided to the auditor is not reliable, or the written representation is not provided at all. In both the cases, the auditor will be giving what opinion? Disclaimer of opinion. Very, very clear. Super clear. Yes. Disclaimer of opinion in case of, again, repetition. But it's okay, we will read through it. Even if it is a marathon, I don't want you to miss any point. The auditor concludes that already for missing and all, people will come and punch. Let us not miss anything. 100% syllabus coverage. Yes, the auditor concludes that there is sufficient doubt about the integrity of the management such that written representation about fulfilling the responsibility regarding whatever of the preparation of financial statements is not reliable. If it is not reliable, then what opinion will be giving? Disclaimer of opinion. The management does not provide the written representation relating to fulfilling the responsibility regarding preparation of financial statement and whatever completeness of the transaction. Again, you'll be giving a disclaimer of opinion. Is that clear? Yes, like I told you, it's a very small standard, easy standard, not much time. What did we study here? Written representation is basically a love letter which is given by the management to the auditor. For what reason are they giving? First one, for the preparation of financial statements, whether they have fulfilled the management's responsibilities. Second, in whatever information that they are provided, everything is complete in nature. Why is written representation again necessary? Now, in SA 210, they would have agreed and they would have understood the responsibilities. But if the auditor is not able to judge, saying that the management, whatever they have given the information is as per whatever they have agreed, this can be appropriated for circumstances. Person who signed is not there right now. Person who signed what happened in the previous year. Person who signed, maybe he did not understand, or any change in circumstances. You will be seeing whether you have to get a written representation again. Now, this written representation has to be done as per the terms of the audit engagement only. Now, the management is giving a sign. Yes, management is giving the love letter. So, management, before they give the love letter, they may decide to make enquiry of people who are having specialized knowledge. Who are those people? Actuary, staff engineer, and internal counsel. Keep saying with me so that you will be getting it in your head, because I myself have told this third or fourth time in this marathon itself. Yes, so you have to keep repeating with me. This is the first part. Other representation, can it be as part of the management representation itself? No, that is separate. This is separate. This could be supplementary, but it cannot form part of the written representation relating to management responsibility. For what reason can you give the other written representation? With respect to selection application of accounting policy, with respect to AFRF, whether it has been recognized, measured, present, or disclosed. For this, we have ALL, that is assets, liabilities, laws, and regulations. You know that. Date of written representation, when should it be? As near as practicable, but not after the date of audit report. I already told you this is very, very important. Please memorize this. Whatever is there in red, the keyword, you memorize it and then you write in your own words. No issues. But the keyword has to be the same. To respond appropriately. How is he going to respond? Whether he has doubts about the reliability, we're going to see. Or if he is not given written representation at all, we're going to see. In both the cases, what opinion we're going to give? Disclaimer of opinion. Now, the entire standard, in how many minutes I finished? 2 to 3 minutes. That's it. That's it is actually there in the standard. But first time when you're studying, it will feel like one huge bulldozer in front of you. But it's nothing. Small points if you keep on studying. And when you put everything together, it becomes very, very easy. Yes, guys, understood SA 580. I hope you're able to appreciate the standard. I hope you're able to enjoy the subject. That is the most important part, guys. Yes? All right, guys.
We'll start off SA 550, guys. related parties. Quickly, let's do the mind mapping. We'll be seeing the scope. What is the definition of related party? Control and significant influence, special purpose entities, nature of related party relationships and related party transactions. Auditor will be inquiring with the management and also with the internal control by the management, and finally auditor will verify existence of related party transactions by seeing a few information. Starting off with the scope of the standard. Now this is also flowing from accounting standard AS. In AS 18, what is it saying? What should you disclose as per AS 18? All the related party transactions you will be disclosing, and the related party relationships you will be disclosing. As an auditor, we will be seeing if everything is as per AFRF, as per the accounting standard. So this SA 550 is auditor's responsibility regarding related party relationships and related party transactions. Specifically, it applies in relation to the risk of material misstatement associated with related party relationship and related party transactions. What is the definition of a related party? A party, if it is defined as per AFRF, if it is already given as per AFRF, then you will just follow that. Otherwise, you will come here and you will see the definition. First one is a person or an entity who has control or significant influence over the reporting entity directly or indirectly through one or more intermediaries. What are they trying to tell? Person or entity has control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. This reporting entity is nothing but your client entity. So basically a person or entity who's having the control over the reporting entity, which is nothing but your holding company. The second one is what? Another entity over which the reporting entity has directly or indirectly through one or more intermediaries have the control or significant influence. Yes or no? So that is another entity over which the reporting entity has control or significant influence directly or indirectly through one or more intermediaries. That means I told you that the reporting entity is nothing but your client entity. Now another entity, the reporting entity has the control on another entity, that is your subsidiary. So your holding company, your subsidiary company will become your related parties. Now see the third one, another entity, that is another common control with the reporting entity, having common control ownership, common KMP and owners who are close family members. Now these people also will come under related parties only. Say for example, your reporting entity, that your client entity is there, they have a holding company. This automatically becomes the related party as per the first point. Now say for example, is holding in another subsidiary S2. Now automatically this reporting entity and this S2 also will become related parties only because they have a common control ownership. Another entity that is under common control with the reporting entity having a common control ownership. Say for example, the director of the reporting entity is also the director of this S2. Then also this S2 and reporting entity, these two become related party for the reason that they have a common key managerial person, common director is there. Say for example, there is a director of the reporting entity, the wife of the director is there in this S. In this case also, these two become related party because owners who are close family members are there. When there are close family members, and this is also a related party, relationship only. Now the definition is talking about, first you see if the related party is defined as per the AFRF. Otherwise, then you see that person or entity who is having control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. That means somebody else is having the control on your client entity, that is your holding company. In the second, another entity over which a reporting entity has control or significant influence directly or indirectly through one or more intermediaries. That means the reporting entity is controlling another entity. This is nothing but your subsidiary. The third, another entity that is under the common control with the reporting entity, having either common control ownership or common KMP or owners who are close family members. So director is there, director's wife is there, director brother is there, then automatically those companies become related party as per SA 550. Definition of related party: a party that is defined in the applicable financial reporting framework, where AFRF establishes minimal or no related party requirements, a person or entity having control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. This is nothing but your holding. Another entity over which reporting entity has control or significant influence, that is nothing but your subsidiary. Another entity that is under common control over the reporting entity through having common control ownership, common key management, owners who are close family members. Now something is excluded from this definition. What is excluded? Entities under a common control of a state. For example, there is a state government which is controlling 51% of this company S. There is a state government which is also controlling 51% of S1. Do they become related party? No. If the state or central or both together, if they are having, then that is an exclusion from the definition. Entities that are under common control by a state, either national or regional or local government, are not considered related unless and until there are significant sharing of resources or significant transactions. Only then they become related party. Now here there is nothing because there is a common control person there, but they will become related if there are number of transactions which is happening between both of these people. In that case, then they become related parties. Is that clear, guys? The definition is done. What is the meaning of control? What is the meaning of significant influence? Your parents are having control over you. Every minute after class, if you don't go home, you will get a call. This is called as control. But imagine after you go for articles, they will be on call. They will tell you not to go for a night show, but still you will go for the night show. You will say okay, okay, and you will go for the night show. At that time, they have that control, but they don't have the control to tell you not to do and also to stop you not to do. They can have the power to tell you, but whether or not you do it is in your hands. That is, they can influence your decision. That is significant influence. Now after you go for movie also, you will be scared. That means they have influenced you at some point. So control means having the power to govern the operating and the financial policy. Here, having the power to participate in the operating and the financial policy. That is the key word that you have to remember. Control is the power to govern the financial and operating policy of an entity so as to obtain the benefits. Significant influence which may be gained by share of ownership, by statute or by agreement. It is the power to participate in the financial and operating policy decisions, but not in control over those policy. These relationships can indicate either a control or some kind of a significant influence. What are those relationships? Direct or indirect equity holding or other financial interest in the entity. That means holding. Directly they are holding in the entity. The entity's holdings or other financial interest in another entity, that is nothing but your subsidiary, being part of those charged with governance or KMP. The KMP people automatically have the control on you. They will only decide how the business has to run. So that becomes control or significant influence. Close family member of TCWG or KMP. Having significant business relationship with TCWG or KMP, then that also indicates that either a control or significant influence can be there. Say for example, director is there. Director has one more business. Is it possible? Yes. He has business number 2. For this business number 2, 90% is supplied for this business number 2 by Shalini. So, even though this director is for this company X, automatically Shalini and X become related parties. What is this confusion? Automatically they become related parties because there is a significant business relationship with the key managerial person. He is a director of business, this company also. So automatically they become related parties. Is that clear? Now what and all did we see? That examples for control or significant influence: direct or indirect equity holding or financial interest in the entity, entities holding of direct or indirect equity holding or other financial interest in the other entity, being part of TCWG or KMP, close family member of TCWG or KMP, or having a significant business relationship with the TCWG or KMP. What are these special purpose entity? A special purpose entity is also a related party because the entity in substance will control it, even if the entity owns little or none of the special purpose entities equity. Equity holding for some people there will be 0, but still they will be able to control the entire organization. You will be knowing they will be relatives. They are not your parents. They are not actually interested, but still they can control our lives like anything. Some relatives like that will be there. You can delete them from your life. So even though equity holding is not there, they will have the control of that entity. That is called as special purpose entity. Is that clear, guys? Now going quickly to the mind mapping, we saw the scope. Scope is nothing but related party relationship and related party transaction. Definition we saw as per AFRF. If it is there, you follow that. Otherwise, 3 we saw. What are the 3? Person or entity having control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. Another entity over which the reporting entity has control or significance directly or indirectly through one or more intermediaries. And third is another entity that is under the common control, common ownership, common KMP, or owners who are close family members. Then we went to what is control and significant influence. Control is power to govern the financial and operating policies. Significant influence is power to participate in the financial and operating policy. What is special purpose entity? They are able to control even though they have very less equity or no equity, they are able to control. Nature of related party relationship and related party transactions. Many related party transactions are in the normal course of business. If it is a normal course of business, that means it is in the arm's length price. That means how much ever I am selling to outsider, the same price I am selling to my mother also. Is there a problem there? There is no problem in that case. But will the mother accept for this? That is a question mark. Many related party transactions are in the normal course of business. In that case, they may carry no higher risk of material misstatement. That means ROM is low only if it is in the arm's length price. However, in some cases, the nature of related party relationship and transactions give rise to higher risk of material misstatement. They are saying, usually if you see related party transactions, if it is in the ordinary course of business, normal course of business, or arm's length principle or arm's length mechanism, if they are following these things, there is no problem at all. But in some cases, the risk of material misstatement will become high. What are those cases? The risk of material misstatement will automatically become high if A is selling to B, B is selling to C, and C is giving to B, B is giving to A, B is also giving to E, E is giving to C, and E is giving to A. You don't know what is happening here, yes or no? It is highly complex. In complex scenarios, the risk of material misstatement automatically increases. the information system itself becomes ineffective to understand what is going on here, because there is so much of money transactions which is going on. Who owes whom what money? Information system is not able to calculate. In that case, the risk of material misstatement becomes high. Or if something which is not in the ordinary course of business or not having the arm's length principle, then the risk of material misstatement will become high. Nature of related party relationship and transactions. Here they are talking about all the related party transactions in the ordinary course of business. Do we have a problem? No, we don't have a problem, because the risk of material misstatement in that case will be low only. In some cases, the ROM will become high. Those are these three cases when it is extensive and complex range of relationship and structures are there. Information systems itself will become ineffective, and lastly, it is not conducted under normal market condition. That means no consideration or low consideration. If it is there, that means it is not following arm's length price. In that case, risk of material misstatement will become high. So the auditor will inquire the management with regarding what and all will the auditor ask the management. They have already shown the related party relationships and the related party transactions in the financial statements. Yes or no? It is the duty of the management to report it as per AS 18. Now, as an auditor, the questions which we will ask the management, what are they? First thing you will ask is, previous year financial statements, you told these people are your related parties. Now, are they still your related parties? Is there somebody else who have changed from the prior period? Identity of the related parties, including changes from the prior period. If they say, yes, this person has been included, what is the relationship? Is he holding shares? Are you holding share? Or is there somebody in common? The nature of the relationship between entity and the related party. If there is any transaction between these two people, what is the type of the transaction? What is the purpose of the transaction? The auditor will inquire the management and the others within the entity and perform risk assessment procedures to obtain an understanding of the control with regard to identifying, accounting, and disclose the related party relationship and transaction, whether it is as per the accounting standard. Who is authorizing? How is the internal control? Who is authorizing and approving the transactions with the related party? Who is authorizing and approving the transaction which is not in the ordinary course of business? These three is to understand what are the internal controls, whether they have followed as per applicable financial reporting framework. These three is for what? Is to understand, is there any new person who has been added for a related party, and is there any new transactions which has happened with the related parties? Is that clear? So the auditor will inquire the management. These 6 points you will have to remember. How much ever you inquire, is the management going to give you the information? No, it is your duty to get the information. So, the auditor will verify the existence of related party relationship and transactions through these points. What are these 3 points? Shri, Clips, CCC. 2 I's are there, correct? What is S? He will go and see the shareholders register. What is R? Regulatory authorities, any documents which is filed with the regulatory authorities, like SEBI, if some document is filed in that, it will be written, this is a holding company, this is a subsidiary company, these are the directors, all the information will be given. So you please see the documents which is filed with the regulatory authorities. I is income tax returns. In income tax return, you will be showing what is the income, everything. In that also, there is a specific place where you have to talk about your holding, subsidiary, and all the related parties. So you please go and see the entities' income tax returns. The next I is any investments that they have made. Investments means what? They have become the subsidiary or your associate. In that case also, you ask them the investments that they have made. C is conflict of interest. That means contracts is triple C. All these 3 are contracts. C is conflict of interest. What is the meaning of conflict of interest? Say for example, one director wants to give free goods to the wife. Another director will fight with him. No, that fight will be recorded in the minutes of the meeting. You will be seeing that minutes and you'll be like, oh, okay, this is a problem. He wants to make this transaction. Whether he has actually made the transaction, whether consideration was received or no consideration received, risk of material misstatement increases. Like that, you will get to know about related party transactions when you see this conflict of interest. What is L? Life insurance policy. Usually for employees itself, the company gives the insurance policy. So here, if there is a director, key managerial personnel, it will be covered in the life insurance policy where the company is taking for the employees. I. Internal auditors report, definitely the statutory auditor has to consider. So there, if you're getting any information with regard to related parties, that information also you can use. What is P? Any professional advice. Okay, you want to know how can I frame it? It is so complex. I will have a risk of mental misstatement will become high. Auditor will unnecessarily, he will poke me and ask the questions. You're going to a lawyer and you're asking for professional advice. Now he is structuring the company and he's saying you please do this like this only, then it is safer for you. If there is any professional advice which is received, then you can have access to that also. What is S? Entities securities regulator. That is, here also we saw regulator, here also securities regulator, specifically to SEBI. That is your securities regulator. These three are contracts. Contracts with whom? Contracts with all of you. Contracts with whom? Contracts with KMP, contracts which are renegotiated with the entity, and contracts with not in the ordinary course of business. A contract which is not in the ordinary course of business, or contract which is renegotiated, or a contract with a KMP. These three C's you will have to check. So when you see all of these things, you know whether related party is there or not. Existence of related party relationship. Quickly the mind mapping will go to that. Scope is done. Definition is done. Control and significant influence. I hope you remember. One is power to govern in the financial and operating policy. The other one is power to participate in the financial and operating policies. What is special purpose entities? They can control, however, they have very minimal equity or sometimes even no equity. They will be able to control. What is nature of related party relationship and transactions? Under this only we saw normal course of business or in the ordinary course of business, if it is there, we don't have any problem. But in few cases, the risk of mental misstatement will automatically become high. One, complex transaction. Information systems becomes ineffective. And third is not in the ordinary course of business. So the auditor will inquire the management and he will see the internal control. 3 points for management, 3 points for internal control. And finally, he himself will go and verify whether there are related party relationships or transactions. For that, we have Shri Clips CCC. Is that clear, guys? Yes. This is SA 550. Just 22 minutes. That's all.
Starting off with the revision of SA 505, that is external confirmations. What is the meaning of external confirmation? A direct written response, which is written response is obtained from the third party and it is directly given to the auditor. SA 505 external confirmation deals with auditor's use of external confirmation procedures. Now this standards on auditing is talking about what the auditor has to do with that external confirmation that he has received. That is the auditor's use of external confirmation procedures to obtain the audit evidence. SA 500 indicates that reliability is influenced by its source and by its nature and is dependent on individual circumstances. Now this source is from the organization or outside the organization? Outside the organization. So the reliability for the external confirmation is very, very high. Quickly going through the mind mapping, we will be seeing the objective of the standard, few definitions that you have to know, important terms, the uses of external confirmation, where and all you can use this external confirmation procedure, what is the procedure that you have to follow, 4 steps are there, and management's refusal to send the external confirmation. If the management is not allowing you to get the external confirmation from third party, then what should you do? Now, if the management allows and you've received that external confirmation, results of the external confirmation procedure, what should you do with that information? Can you rely on that information? And finally, we will be saying what is negative confirmation and when we will be using negative confirmation. Is that clear? The first one is the objective of the auditor. when using external confirmation procedure is to design and perform such procedures to obtain relevant and reliable audit evidence. Why relevant and reliable audit evidence? Usually audit evidence has to be sufficient and appropriate audit evidence. Yes or no? Under sufficiency, it is quantity. That means quantity is affected by three things. What are the three things? Risk of material misstatement, size of the population, and materiality. These three things are for sufficiency, that is the quantity of audit evidence. But now we are talking about external confirmation. That means we are only bothered about the quality, that is appropriateness. Under appropriateness only relevance and reliability comes into place. That is the reason why the objective of the auditor is, it is for such procedures to obtain the relevant and reliable audit evidence. Is that clear? Everywhere you will be seeing SAI. This is the only place you will be seeing R&R audit evidence. Definition. What is external confirmation? It is a direct written response to the auditor from the third party. It can be in paper form or electronic form or any other media. Say for example, the auditor is asking the management itself to get that external confirmation, or the management is getting from a debtor and giving it to the auditor. Is that okay? No, because it has to be direct only. The auditor is sending a friend to the debtor's place, getting that confirmation and coming. That also is not acceptable. It has to be a direct response from the third party to the auditor. No people in between these two people. Is that clear? That is the definition. Going to important terms, there are 4 terms that you have to remember. One is you will have to say yes or no. When you ask a girl out, what you will want? You will ask her to say yes or no. You all are accepting. If she says no also, it is okay. That is good. You should accept whatever is coming from that side. That is called as positive confirmation. If she doesn't say anything and go, and she goes off, but still you are considering that as yes, that is called as negative confirmation. Maunam samadam. That is, negative confirmation comes only if that other person is disagreeing with whatever you are saying. Only then they will respond to you. Otherwise they will just stay silent, and you will, silence means acceptance. You will consider like that. That is negative confirmation. Non-response means what? The other person is failing to respond to you. Now say for example, the other person is giving the information, but he is giving partial information. That is also called as non-response only. Non-response means failure to respond or failure to fully respond. Both are coming under non-response. Exception means I have this debtor's figure in hand with me for 5 crores. Now when I ask that person, he is saying that I need to owe only 1 crore. So the exception means the remaining 4 crores, the difference between the information that I am having and the difference between that confirmation that I am receiving. So that is called as exception. Read through the theory. Important terms: positive confirmation request, negative confirmation request, non-response, and exception. A request that confirming party responds directly to the auditor, whether he agrees or disagrees with the information in the request, whatever it is, he will communicate. That is called as positive confirmation request. What is negative confirmation request? A request that confirming party responds directly to the auditor only if the confirming party disagrees with the information which is provided. Only if he says no, he is going to come and give the information. If it is yes, he will just stay silent. What is non-response? A failure of the confirming party to respond or fully respond to a positive confirmation request, or a confirmation request returned undelivered. Even if it doesn't go to that person in mail, there will be something called as mailer daemon. That means if you send an email to somebody and if it doesn't go to that person, that email address does not exist, this mailer daemon will send it back to you, and if you go inside, it will say that this email ID does not exist or something like that. So this request has returned back to you undelivered. That is also considered as non-response only. Non-response means fully they are not responding, or partially they are not responding, or
this is not going to them itself. In all these three cases, we will call that as non-response. What is the meaning of exception? A response which indicates a difference between information requested to be confirmed or contained in the entity's record and information provided by the confirming party. The exception needs to be assessed to the entire population after analyzing the reason for difference. Is that clear? What is the meaning of exception? What is the meaning of non-response? What is the meaning of positive and negative confirmation request? Use of external confirmation. Where and all can I use this? Where can I go and disturb that third party? You can disturb him if you want him to confirm any terms of agreement or contracts. Say for example, year on year rent is paid for 1 lakh rupees and suddenly there is an escalation. Rental always escalates every year. Escalation is of 5%. Now you want to know if this is correct or not. You will see the contract. You will see the contract. Yes, it is there. Now this contract is by the management and some third party. Now you will say, okay, you have this contract. I want to see the contract of the third party also. He will have a copy of the contract. So now I am going and disturbing the third party. So that is confirming the terms of agreement, contracts, transactions between entity and third party. For any transaction which is happening between entity and an outsider, the auditor can come inside and he can disturb the outsider. Purchase transaction, sale transaction, any kind of expense, you can disturb the third party to the organization, because expense can be for what? Rent, salary, wages, office equipment, stationery, all of those things. So even if you say stationery expenses 5 lakhs, from whom you got that stationery? You please give me that contact. I can contact him and I can get an external confirmation. Amount due to lenders, amount due from lenders, property title deeds which is held by lawyers and financiers as securities. Because sometimes what will happen, when they give collateral, they will give the property as collateral and get the money. Say for example, I want 1 crore rupees loan. If I want 1 crore rupees loan, I will give a property for 1.5 crores to the banker and I will get the money for 1 crore. Now that banker is having the title deed of this property. Now when I went and asked the management, what will the management say? I don't have the title deed, sir, the banker is having. Now you will go and disturb the banker to get the external confirmation. External confirmation means you are going outside the organization. That only is third party. That's why direct written response from third party to the auditor. There are few procedures when you have to approach somebody. Now when you go and give that flower to the girlfriend, prospective girlfriend, and you want to propose, first you have to, step 1 is determining the information to be confirmed or requested. How you are going to say that I love you? Simply if someone comes and says, I love you, what you will give? Slap. Yes or no? You will give that tight slap. What is this? You have to put that mane, tene, punmane, and then frame that letter, and then you have to make a huge setup, beautiful setup. All these things are important. So you have to first determine the information which is to be confirmed or which is to be requested. Select the appropriate confirming party. Now say for example, Abdul Kalam wants to tell to some girl. What Abdul Kalam is doing? He is telling to princess. He is telling to Darshan and he is telling, can you tell to that girl? What Darshan will do? He will take that girl. From that time he is very bad in his behavior. So you have to be very careful. If you have to tell to girl, you have to directly go and tell to girl only. So selecting the appropriate confirming party. Don't select this stupid friend next to you. He will take your girl and he will go. So you select the appropriate confirming party. Designing the confirming request. The way you tell. That is the most important thing. This is the most important thing, because packaging, we love good packaging. Yes, you all told me some chocolate, Kinder Joy, worst chocolate, but beautiful packaging. Inside they'll give some toy and they will make all the customers buy this. All kids' favorite chocolate is Kinder Joy only. They have designed it so well, even though the chocolate is bad, they are able to sell those chocolates. That is designing the confirmation request. And finally, you will send that request. You will send that letter. Like Ambi, you will write that full paragraph, 5 pages, and you will give to Nandini. Now, will Ambi just give once and leave it? Again and again he is asking Nandini, Eppo solluva, when you will tell me, like that he will ask or not. So follow-up request is also important. Sending the request, including follow-up request. 4 steps are there. First one is determining the information to be confirmed. Second, select the appropriate confirming party. Third, designing the confirmation request. And fourth is sending the request, including follow-up request. All 4 points are important. The first step is determining the information to be confirmed or requested. External confirmation procedures frequently are performed to confirm or request information regarding account balances and their elements. Usually they'll go for balance sheet items, they are saying. They may also be used to confirm terms of agreement, contracts and transactions between an entity. P&L items also will. Basically, for anything you can do that external confirmation, guys. Frequently they used for account balance, that is balance sheet items, but you can also use for P&L items, for contracts, for agreements and all of those things. Sometimes you will do the external confirmation to confirm the absence of side agreement. What is the meaning of side agreement? Side agreements are agreements which is basically like an addendum to the original agreement. For example, when you want to propose to girl, if she's already having the boyfriend or she's having a brother who is going to gym regularly, all these things are important. Who is around her also you have to know. Like that, when you are confirming an agreement, you also need to know if there is any side agreement which is attached to the agreement. Now usually whenever there is an engagement letter which is given, engagement letter is prepared usually for 1 year. So for the next year, if there are not many changes, I am only going to increase the period of that engagement letter. So instead of doing everything from scratch, I will just add a specific sheet of paper which is called as addendum, which is called as side agreement. Say for example, in the rental agreement, it is written that every year escalation clause is 5%. Now I don't want to change anything in that rental agreement except for that escalation percentage. I want to make it 7.5%. In that case, I will add a side agreement and I will say that all the agreement is same except for this para number 11. In para number 11, the changes are from 5% to 7.5%. Now both parties are agreeing, you put the signature. So for anything, if you want to make a minor change to the agreement, then you can have a side agreement. So as an auditor, whatever is given to us have to be complete. For that, we will be asking, is there any side agreements? So for confirming that, we'll have to ask, determine if the information to be confirmed or requested. What is the information? The information which has to be requested also should include any absence of side agreement. Are you giving me the complete information? Like that you have to ask. Step number 2 is selecting the appropriate confirming party. You have to select the people properly. Responses to confirmation requests provide more relevant and reliable audit evidence. When confirmation requests are sent to a confirming party, the auditor believes is knowledgeable about the information which is to be confirmed. Say for example, here in one case we saw property title deed held by financiers as security. The banker is holding the title of your property, of the management's property. Now we as auditor, we have to go to the banker and we have to get that external confirmation. Yes or no? What we are doing, we are going till the bank, but we are asking the security guard. Will he give any kind of information? No. Is he a knowledgeable person? No. He will not know the account details and all. So in the knowledge of the auditor, if he believes that this person has the appropriate knowledge, then you can ask the appropriate confirming party for the information. Step number 3, I told you design is the most important one. Designing the confirmation request. Factors to be considered by auditor when designing confirmation request include. There are a few factors that the auditor has to keep in mind when he is designing the confirmation request. Say for example, I want to know whether a particular asset is given to the banker as collateral. Now, if I give external confirmation asking what is the value of the asset, is it holding the same assertion? I am asking for confirming the valuation, but in reality I want to know the title. So I am looking at two different assertions. So the factors to be considered by auditor when designing the confirmation request. The first one is, what is that assertion that you are addressing? What is the risk of material misstatement which can happen here? What is the layout of the presentation? What is the prior experience on the audit or similar engagements? What is the method of communication? Is the management okay for me to go and disturb those third parties? Are the management authorizing or are they encouraging for those third parties to give us the information? The ability of the intended confirming party to confirm. Now we are thinking that he has the information and we are going and telling the information, but they are not able to give us any kind of information. That is the last point. These are the factors when designing the confirmation request. There are 7 factors which you have to keep in mind. What are those 7? Assertions being addressed, identified risk of material misstatement, the layout and presentation of the confirmation request, prior experience on the audit or similar engagement, method of communication, management's authorization, and finally, whether the confirming party is having the ability to confirm or respond. So these 7 are the factors which is basically considered by the auditor when he is designing the confirmation request. Designing the request for third point. For which question? Designing the request is the third point for, we are studying procedure. Procedures which has to be done by the auditor for giving the external confirmation. Under that, step number 1 was the information which has to be confirmed. Step number 2 was selecting the party who has to confirm the information. Step number 3 is designing the request. Under designing the request, the first point was for under design of a confirmation request. That was the first point. The second is factors to be considered when he is designing the confirmation request. The third point is positive confirmation request. Positive confirmation, we already saw in the definition, whether he agrees or disagrees, the confirming party has to respond. The positive external confirmation request asks the confirming party to reply to the auditor in all cases, either by indicating the confirming party's agreement or by asking confirming party to provide the information. This can happen by two ways. One is, I am telling you that the accounts show that the debtors is 5 crores and your name is there, 5 crores is there. Are you confirming this? If yes, you please respond. If no, also you please respond. This is one way of asking. The other way is, in my books of accounts, I can see that debtors is there. Can you please let me know the amount? That is another way of asking the same information. Now, in the second case, we are giving a blank paper where they are filling and they are giving us the information. Which one is more reliable? The second one is more reliable. The auditor may reduce the risk by using positive confirmation requests that do not state the amount on the confirmation request and ask the confirming party to fill in this amount or furnish other information. Is that clear, guys? Now the fourth one is determination of properly addressed requests. Determining that requests are properly addressed, including testing the validity of some or all of the addresses on confirmation requests before they are sent out. And finally, step 4 is sending the request, including the follow-up request. Sixth Roman is management's refusal to allow. Quickly, let's go to the mind mapping again. The first one was the objective, definition, uses of external confirmation. We finished the procedures and now we are going to management's refusal to send the external confirmation. Now say for example, management is refusing to go for external confirmation for the reason that that debtor is in coma. Is it reasonable? Yes, it is reasonable in nature. If it is reasonable, you perform the alternate audit procedures. Now, in this alternate audit procedures, are you obtaining sufficient appropriate audit evidence? You are good to go. You have the sufficient appropriate audit evidence. Say, for example, they gave the reason, it is reasonable, you are trying to do the alternate audit procedures, but you are unable to get any kind of information through these alternate audit procedures, or you are unable to do the alternate audit procedures. In that case, you will be going for SA 705. You will be going for SA 705 modification, but before that you also have to communicate with the TCWG, that is SA 260 has to be done. Is that clear, guys? Now, if it is reasonable, if you are able to do the alternate audit procedures, then no problem, you will be obtaining the sufficient appropriate audit evidence. If you are not able to do the alternate audit procedures, then nobody can save you. You have to take the weapon out, that is SA 705. But before you take the weapon, you please mention that to those charged with governance, that is SA 260. Is that clear? Now, in the second half, the information that they are giving is not reasonable. He is simply saying he is in coma, but you can see in Instagram he is dancing and he is putting the reels there. Then in that case, it is not reasonable. That means what? Directly you will go for modifications, and you will also have to inform those charged with governance. So again, refusing for external confirmation. If it is reasonable, you will be doing the alternate audit procedure and you will be obtaining the sufficient appropriate audit evidence. If it is not reasonable, you will go for modifications with SA 260. And if it is reasonable and if you are not able to do the alternate audit procedures, again you will go for SA 705 modification and SA 260, communicating with those charged with governance. Is that clear? Now going to the theory part. Management's refusal to allow the auditor to send a confirmation request. The auditor will first inquire as to management's reasons for the refusal and seek the audit evidence as to their validity and reasonableness. Evaluate the implications of the management's refusal. What is the management saying? Debtor is in coma. Please don't disturb him. That is the implication on the risk of material misstatement. Perform alternative audit procedures which is designed to obtain relevant and reliable audit evidence. If the auditor concludes that management's refusal to allow to send is unreasonable, or the auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedures also, in that case, he will communicate with TCWG under SA 260 and he will determine the implications under audit and the auditor's opinion under SA 705. He'll go for modifications. If the management refuses to send for external confirmation, inquire management, evaluate implications. If reasonable, perform alternate audit procedures, obtain the SAI. If it is reasonable, cannot perform alternate audit procedure 260 and SA 705. If it is not reasonable, directly 260 and SA 705. Same thing is given in this paragraph. The next one is talking about the results of external confirmation procedures. Now say for example, the first part, the 6th Roman number, we saw that the management is not allowing you to communicate with the external party, that is a third party, confirming party. In the 7th case, the confirming party has given some information to you. Now you are having doubts about the reliability. Say for example, that debtor is his best friend. Now he has told that 5 crores I have written in my books of accounts. Oru loose varuvan, avan kepan, avan enna ketalum you say what is the answer as 5 crores. Like that they already have a dealing. Now in this case, you will have to see whether you can rely on that information which was given by the third party. If you have doubts about the reliability, you don't know whether you can rely on this or not. In our Pratap example, we didn't know whether we can rely on that or not. We had doubt initially, but after some days It was confirmed. No need after some days, after few minutes, it was confirmed that he is a full fraud. If you have doubts about the reliability, you go for further audit evidences. If it is completely not reliable, then you evaluate implications on your risk of material misstatement. Is that clear? Reliability of responses to confirmation request. If the auditor identify factors that gives the rise to doubts about the reliability of the response to a confirmation request, then he will go for further audit evidence to resolve the doubt, because it is only a doubt about the reliability. If the auditor determines that response to a confirmation request is not reliable, he has confirmed that it is not reliable, then he will evaluate implications on the ROM. If that is not reliable, can we give a modified opinion? No, only if there is a material misstatement in the financial statements, we will be going for modifications. If that third party is giving non-reliable information, what can the management do for that? It can be an error or a fraud by the third party. The management might not be involved. So, we will only evaluate implications on the assessment of risk of material misstatement. Now the last part, which is about negative confirmation. Negative confirmation means only if they disagree, they are going to respond to you. Otherwise, they'll just have a non-response and you will accept that as agreement. Yes or no? Now, can you use this negative confirmation for all the scenarios? No. You will be using the negative confirmation only in these 4 scenarios. The first one is the risk of material misstatement is very, very low and has obtained SAI regarding operating effectiveness of controls relevant to the assertions. Already I have the sufficient appropriate audit evidence somewhere else. So here I can be a little relaxed and ROM is very low. The second one is the population is subject to small homogeneous account balance class of transaction and disclosures. What is small homogeneous? Homogeneous means they are similar to each other. They are same. So, if they are same as each other, in one place I have already gotten the audit evidence. In the other place, if I don't get an external confirmation also, it is okay. So, in that case, I will go for negative confirmation request. A very low exception rate is expected. You know that this person will definitely respond to you. Only in that case, you will go for this. When will you know that that person will definitely respond to you? Say for example, he is a debtor. Debtor means what? Person who has to give or person who has to get the money? Person who has to give the money. He has to give the money. Say for example, the debtors is 5 crores and the auditor feels that debtor is overstated. If the auditor feels that debtor is overstated, that means in reality it might be only around 1 crore and in the books of accounts it's shown as 5 crores. Now he has to give the money. If in reality, if he has to give only 1 crore and in books of accounts it's shown that he has to give 5 crores, in this case, I can go for negative confirmation because I will be sure that if there is a mistake in the amount, especially if I know that it is overstated, then I can go for negative confirmation because you just think in the other person's shoe. I am suddenly going and saying, sir, you have to give me 5 crores. Is it yes or no? If he really has to give only 1 crore, will he immediately respond? Yes, you know that the exception rate is going to be low for overstatement of debtors. The auditor feels that debtors is overstated. Same way for creditors. Understatement of creditors. Creditors means the company has to give the money. Say for example, the company has to pay somebody 5 crore rupees and the auditor feels that this amount is understated. That means it is actually not 5 crores, it is 10 crores. So the company has to give 10 crores, but in books of accounts it's mentioned as 5 crores. In that case, I can go for negative confirmation because in the shoes of the other person, if you see, he will definitely respond if he has to get 10 crores. Yes or no? So depending on the assertion that I am addressing, I will decide whether the exception rate is high or low. If I know that the exception rate is going to be low, then I can go for negative confirmation request. Is that clear, guys? What is the last one? The auditor is not aware of the circumstances or conditions that would cause the recipients of negative confirmation would disregard such requests. They are using double negative here. The auditor is not aware that the third party will disregard. Disregard means he will not respond, or he will just throw that question in the dustbin. He will just move your mail to the recycle bin. All those things. You know for sure that he will not disregard. He will not throw it in the dustbin. That means he will definitely respond. Only in that case you can go for negative confirmation. Negative confirmation, 4 points are there. What are the 4 points? The risk of material misstatement is low. He has obtained sufficient appropriate audit evidence somewhere else. Large number of homogeneous population, low exception rate, and auditor is not aware that he will disregard. So in these 4 cases you can go for negative confirmation request. What is positive confirmation request? Whether he agrees or disagrees, the confirming party will be responding. Results of external confirmation procedure, you have small doubts about the reliability. In that case, what should you do? Further audit evidence. You know for sure that it is not reliable. Will you go for modification? No, it is not reliable for the information which is given by the third party. In that case, you will just see whether it is implying whether it is affecting your risk of material misstatement. You will see the implications on the risk of material misstatement. Now, if the management is saying, no sir, you cannot go and disturb the third party, then you will ask for reasons for the same. If it is reasonable, you will obtain the sufficient appropriate audit evidence. If it is not, if it is reasonable, you will perform the alternate audit procedures and you will obtain the sufficient appropriate audit evidence. If you are not able to perform the alternate audit procedures, you will go for modifications, but you will inform to those charged with governance, that is as per SA 260. If the reason that the management is giving is not reasonable, then in that case also you will go for modifications SA 705. But before that you will inform to those charged with governance as per SA 260. What are the procedures that you have to follow for giving the external confirmation? There are 4 steps which is given here. The information which is to be confirmed. Selecting the party to get the information. Third, design of that request. And fourth is sending the request, including follow-up request. Now under design we saw 4 points. The first one was design only. The second is factors to be considered for designing by the auditor. What are the factors? The assertions, risk of material misstatement, layout and presentation, previous year's experience of the auditor with that third party, what is the method of communication, and whether the management is authorizing or allowing the third party to give the information. Anything else? To ability to confirm of that third party, whether he has that ability, that also we'll have to check. All these are factors to be considered by the auditor for designing the confirmation request. And finally, what is it? Positive, yes, what is positive request we saw, and last, whether it has been properly addressed. Next, what are the uses of this external confirmation? Uses: confirming the terms of agreement, contracts, transactions, and property title deed held as collateral with another financier. So these are just examples which is given. This is not a exhaustive list, it is a inclusive list, because if you see, amount due to lenders is given, amount due from lenders is not given, but for that also you can get an external confirmation only. What are the terms? Positive, negative, you know. Please tell me what is non-response. Non-response, they are not fully responding, or partial non-response is also non-response. Failure to respond or failure to fully respond is a non-response. What is exception? Difference between the amount as per the books and the amount that the confirming party is giving you. What is the definition of external confirmation? What is the definition? It is an audit evidence which is obtained as a direct written response from the third party to the auditor in paper, electronic or any other medium. From back to front we have come, and with this essay 505 comes to an end. Essay 510, essay 510 is initial audit engagement, opening balances. This standard is basically there because when the auditor puts his signature, he is not only signing for the current year, but he is also signing for the previous year information, because sales, purchase, everything you write, you will be giving the current year and you will be giving the previous year information. So this signature is valid for this figure also. Yes, that is the reason why SA 510 is actually there. And the standard deals with auditor's responsibility with relating to the opening balances. This opening balances is not only the amount but also the disclosures. You should not forget that. It is not only the amount but also the disclosures. So first of all, why we have the standard you understood, and what is covered in the standard you understood. Not only amount but also disclosures. Now you all tell me, in case the previous year is not audited at all, is it very risky? Yes, very risky. So SA 510 will come into place here. In the previous year, it is audited, but it is audited by some other auditor. That is, it is audited by a predecessor auditor. In this case, is it still risky? It is not very risky, but yes, it is risky. In the previous year, it is audited by the same auditor. One auditor can be appointed for 5 plus 5 years, then only cooling period of 5 years. So the same auditor is the auditor for the previous year also. Here, is it risky? No, it is not risky. So SA 510 does not cover the third area. The first and second area it definitely covers. What is the first one? In the previous year it is not audited at all, or in the previous year it is audited by a predecessor auditor. In these two cases SA 510 will come into place. And SA 510, not only the amounts but also the disclosures. Did you understand till here? Yes, read the text till here. This standard deals with auditor's responsibilities relating to opening balances when conducting an initial audit engagement. In addition to the financial statements amounts, opening balance includes matters requiring disclosures also. Quickly, the mind mapping. Here SA 510 talks about the definition, objective, audit procedures and 2 cases which is given here. Now, definition of initial audit engagement. An engagement in which either the financial statements for the prior period were not audited, or the financial statements was for the prior period was audited by a predecessor auditor. So there might be a case study based question where the financial statements are audited by, they'll give a name, they'll not use the terminology predecessor auditor. They'll say Darshan. Now the current year, Shalini is appointed as auditor. Now what you have to know, automatically your mind has to go to SA 510 because they're talking about some other auditor was there for the previous year. Going to the second one, objective of auditor with respect to opening balances in conducting an initial audit engagement. In conducting an initial audit engagement, the objective is to obtain sufficient and appropriate audit evidence with regard to 2 things. One is there any material misstatement in the opening balance which is predominantly affecting the current year position also? The second thing, the entire standard is talking about these 2 things only. One is whether any amount in the previous year is affecting the current year figure. The second thing is with regard to accounting policies, because accounting policy has to be followed year after year. Darshan, come back to auditing class. CA Darshan sonna odane, ma'am, CA Darshan, so nice to hear. He went off there itself. Come back to class. Now, where were we? Accounting policy has to be consistently followed. Appropriate accounting policy reflected in the opening balances have been consistently applied in the current period financial statements. If there is a change, whether it has been adequately presented, whether it has been disclosed as per the accounting standard. Is that clear? So basically the objective of the auditor with respect to SA 510 is to obtain the sufficient appropriate audit evidence with regard to any misstatement which is there in the opening balances, whether it is going to affect the current period. And the second one is talking about accounting policies, whether it has been consistently followed. If it is not consistently followed, whether it has been adequately presented and disclosed as per applicable financial reporting framework. Third is audit procedures regarding opening balances. Quickly just going to the mind mapping. We are done with the definition. What was there in definition? An engagement in which the financial statements for the prior period was not audited or it was audited by a predecessor auditor. That was the definition. In the objective, what did we see? To obtain sufficient appropriate audit evidence. That is the way you have to start. Don't directly start off with misstatement in the opening balance. Don't start with that. The objective as an auditor is to first get the evidence that if there is any misstatement in the opening balance which is affecting the current year balances. The second point is whether accounting policy has been followed consistently. If not, whether it has been presented or disclosed appropriately. Going to the third one, that is the audit procedures regarding the opening balances. The first audit procedures that the auditor has to do is read the recent financial statements and the predecessor's auditor's report thereon for any information regarding opening balances, which is including the disclosures. So the first audit procedure is reading the financial statements. That is the first procedure that the auditor will do. What is the second procedure? The auditor shall obtain SAI about whether opening balances contain misstatement that materially affect the current period financial statement by determining whether prior period closing balance have been correctly brought forward. For example, previous year it was written as 54,234. Now in the current year, when you are bringing it forward, it is written as 54,423. Is it possible? In olden days when the standard was created, it is possible. Right now the computer is doing the job. So right now this point is actually irrelevant. Determine whether prior period closing balances have been correctly brought forward to the current period or when appropriate any adjustments have been disclosed. Determine whether opening balance reflect the application of appropriate accounting policies. The first point is talking about opening balances, whether it has been carried forward properly. Second point is talking about accounting policies. Performing one or more of the following. What are they saying? Where the prior year financial statements are audited, perusing the copies of audited financial statements including other documents, evaluate whether audit procedures performed in current period provide evidence relevant to opening balance, perform specific audit procedures for the opening balance. Now, what are these 2 points talking about? This is easy. Whether prior year financial statements are audited, you will be reading the copies of audited financial statements or any other documents which is relating to the prior financial year. Now the second and third point you have to understand. Say for example, you are doing your audit procedures. In your P&L, there was something called interest expense of 5 lakhs. On this 5 lakhs, you are doing your audit procedures. When you are doing your audit procedures on the interest expense, you found out that the opening balance of that loan itself is wrong. What is interest expense? How is this calculated? A percentage of the opening balance of the loan. So you are basically doing the audit procedures on the current year for you to find out that there is a mistake on the opening balance figure. Is that clear? That is this point. Evaluate whether audit procedures performed in the current period provide evidence relevant to the opening balances. Are they giving evidence? This interest expense was giving evidence for the opening balance of loan, yes or no? The second one is talking about doing the audit procedures directly on the opening balances. In this case, we did the audit procedures on the current year figure. then that gives some evidence with regard to opening balance. The auditor also has to do audit procedures directly on the opening balance, because to see the closing stock, he will see purchases, he will see sales, he will also see the opening stock, yes or no. In this case, he will be doing the audit procedures on the purchases, audit procedures on the sales, and audit procedures on the opening stock also. In this case, he is doing audit procedures directly on the opening balances. That is the next point. Performing specific audit procedures to obtain evidence regarding the opening balance. Is that clear? Yes. Now, audit procedures regarding opening balances. How many points did we see? The first point is the auditor has to read the most recent financial statements and also the auditor's report. Then he will obtain SAI by ensuring that the opening balances does not contain any material misstatement which is going to affect the current period, by seeing that whether it has been brought forward correctly. That means whatever amount is there in the previous year has been correctly brought forward to the current year also. Determine whether opening balance reflect the application of appropriate accounting policy. Whether prior year, if it is audited, perusing the copies and evaluating whether audit procedures performed in current period provide the evidence relevant to the opening balance. This is the interest example I told you. The next one is performing specific audit procedures to obtain evidence regarding the opening balances. Here audit procedures will be done on opening stock to find out about closing stock. Here audit procedures was done on the interest expense, and by mistake he found out that loan outstanding, opening loan outstanding itself, there was a misstatement there. Going to the two cases. The first case is talking about if you have an audit evidence that you know that there is the material misstatement in the opening balance and it is materially affecting the current year figures also, then in that case, what should you do as the auditor? Say for what should you do? Additional audit procedures is what you will do. Now in that additional audit procedures also, you are concluding that misstatements exist. Then you will communicate with those charged with governance and management. Is that clear? Here, will you go for any modifications? Will you go for any modifications? No, this is still pertaining to the previous year. Case number 1, if the auditor obtains audit evidence that the opening balance contained misstatements that could materially affect the current period financial statements, the auditor will perform additional audit procedures as are appropriate in the circumstances to determine the effect on the current period's FS. If the auditor concludes that such misstatements exist in the current period financial statements, then he will communicate with appropriate levels of management and those charged with governance. Now, if there is a material misstatement and it is material in the current period and it is misstated, then finally, after communicating with those charged with governance, they are not doing anything. Finally, you are going to use your weapon. You cannot do anything. But the standard is not talking about it. This standard is just saying if there is a misstatement and it is material and it is affecting the current period financial statements, see if it is material for the current period financial statements. And then you communicate with the appropriate levels of those charged with governance and management. That's all the standard is saying. Case number 2 is talking about accounting policies. Here there are only two things again and again. One is misstatements in opening balance, and the second one is accounting policies not consistently followed. So here case number 2 is the current period's accounting policies are not consistently applied in the relation to opening balance in accordance with AFRF, or a change in accounting policies is not properly accounted for or not adequately present or disclosed in accordance with AFRF. What are they saying? It is not as per applicable financial reporting framework means it is not as per accounting standard. If it's not as per accounting standards, there is a material misstatement. If there is a material misstatement, then you have to give what opinion? You have a sufficient appropriate audit evidence that there is a material misstatement. You don't know about the pervasiveness of the case. At that time, you will be giving a qualified opinion or a adverse opinion. Reporting by SA 705 by auditor regarding opening balances. If the auditor is unable to obtain SAI regarding opening balances, then the auditor shall express what opinion? Qualified or disclaimer of opinion, because if there is no sufficient appropriate audit evidence, he has to see that there is a material misstatement. Pervasiveness, if it is there, he'll be giving a disclaimer of opinion. If it is not there, he'll be giving a qualified opinion. So if the auditor is unable to obtain SAI, he will be either giving a qualified opinion or disclaimer of opinion in accordance with SA 705. If auditor concludes that opening balance contains a misstatement that materially affect the current period financial statements and the effect of the misstatement is not properly accounted for or not adequately presented or disclosed, then the auditor shall express now you have the sufficient appropriate audit evidence, but you don't know whether it is pervasive or not. Now you will be giving either a qualified or a adverse opinion. Is that clear between the first and second one? The first point is talking about having no sufficient appropriate audit evidence. The second point is talking about you have the sufficient appropriate audit evidence and it is materially misstated. So regarding the pervasiveness, you will see if it is pervasive, you will be giving an adverse opinion. If it is not pervasive, you will be giving a qualified opinion. Is that clear, guys? Now quickly let's go through the entire standard. SA 510 initial audit engagements, opening balances. What is the definition of initial audit engagement? First of all, this initial audit engagement, the auditor will be seeing only the amount or amount plus disclosure? He'll be seeing amount plus disclosures. Definition of initial audit engagement: an engagement in which either the financial statements for the prior period were not audited or the financial statements for the prior period were audited by a predecessor auditor. What is the objective of the auditor? It is to obtain the sufficient appropriate audit evidence for what? That the opening balances, if it contains any misstatements, whether it is going to affect the current period. If you see the objective, that only is the conclusion also. In the two cases when we saw, finally what did we see? That there was a material misstatement in the prior period which is currently affecting the current period. As an auditor, what opinion are you giving? If it is currently affecting and if it is material in the current year, you will be giving a qualified or adverse opinion. Like that they are concluding from that objective, if you see. Yes? So the second objective is appropriate accounting policies has to be consistently applied, and if there is any change, whether it has been presented or disclosed. What are the audit procedures that you have to do? You have to read the most recent financial statements and the auditor's report. See whether the prior period closing balances have been appropriately brought forward to the current year. Second is appropriate accounting policies, whether it has been followed. Evaluate whether audit procedures which is performed in the current year is showing any misstatement in the opening balance, or any audit procedures directly on the opening balance also you will be doing. Case number 1 is talking about what? That there is an audit evidence in the opening balance, and that misstatement, that there is an audit evidence that there is a misstatement in the opening balance, and that misstatement is material in nature, and that misstatement is also affecting the current period. In that case, you will be doing additional audit procedures and you will be communicating to those charged with governance. Now continuation to down. You have communicated to those charged with governance and you know that it is material for the current year also. Now that there is a material misstatement in the current year, you have the sufficient appropriate audit evidence regarding the pervasiveness of the case. You will be giving either a qualified or a adverse opinion. Now going to case number 2, if the auditor we left off in case number 1 only, correct? Case number 2, if the auditor concludes that accounting policies is not as per AFR, if they are not following the accounting standards, now you have the sufficient appropriate audit evidence that there is a material misstatement, but you don't know whether it is pervasive in nature. So again, you will be giving a qualified or a adverse opinion. Going to the next part. If the auditor concludes that, now I am in the second part, the first one we already finished. If the auditor concludes that the opening balance contains a misstatement that materially affect the current period and the effect is not properly accounted for or not adequately presented or disclosed, then he will be giving a qualified or adverse opinion. First part only we didn't do. The auditor is unable to obtain the sufficient appropriate audit evidence. Now he does not have sufficient appropriate audit evidence based on pervasiveness. He'll be either giving a qualified or a disclaimer of opinion. Few additional points to note. Consistency of accounting policies relating to opening balances. We saw that relevant information in the predecessor audit report has to be there. Audit conclusions and reporting should include the opening balance also, and modifications to the opinion in the predecessor auditor's report, we will have to take care of that. Say for example, closing stock, nala they have given an adverse opinion in the predecessor auditor report. Now, should we also consider that? Obviously, it will have a direct impact on our opening stock and again our closing stock. So, as an auditor, we have to consider the modifications to the opinion in the predecessor audit report also. Is that clear? With this essay, 5:10 comes to an end.
Let's do CARO, guys. The marathon of CARO starts now. CARO basically has 21 clauses: fixed assets, inventory, leaks provided, deposits, cost records, statutory dues. Now, how are you going to remember all of these clauses? First of all, CARO stands for Companies Auditors Report Order 2020. Don't write CARO in the exam. Please write Companies Auditors Report Order 2020 and only then you are going to get the marks. Now coming to how you are going to remember each of the clauses. Please be with me right now. There was a very worst person. The worst person you can ever think of is there. It is a kutty story. Laptop not cooperating. Now, what this worst person did, he bought a land. On top of that land, he put the building. Now, you all tell me, inside that building, is he going to keep it empty? He is going to put all the saraku, that is the stock, that is the inventory. And how did he get the inventory? Did he get it by his own money? He got loan for the inventory. Now, like I already told you, he is a very worst person you can think of. So, what he did, he got the loan for this inventory, but he did not give it to the supplier. He put it as fixed deposit to enjoy the money. Fixed deposit will give the interest. So, he did like this. Now, from the beginning, let me tell you, there was a very worst person you can think of. This worst person got the land and he constructed the building, and then inside the building, he kept the stock. Now, how he got the stock? By way of loan. But did he use it for the stock? No, he put it as his deposit so that he can enjoy that money. Now, he maintained proper records to not get caught with the government. So he maintained records. Usually you see people who are doing all the frauds, they will not file the nil return. They will not say zero return. They will say some money. If they have to pay 10 lakhs, they will just pay 10,000 rupees. So when he was paying the tax dues, that is the statutory dues, he got caught. Now once he got caught, the government is asking him the questions. What question did they ask? From where did you get all your income? There is so much of income, but I don't know from where you got. Proper accounting is not there for the income. Unrecorded income is there. From where did you get all of those things? Now the government told him, I know what and all things you are doing. You got the loan and you put it as deposits and all. I know all the things that you are doing. You better repay all the loans immediately. What they told? You have to repay the loan. Now, he said, okay, fine, sir, I will repay the loan immediately. But I told you he is a very worst person. Is he going to repay from his own money? He is going to go for public issue. That is issue proceeds. He went for that just to repay all the loan. Aga mottham avan pannadu ellame fraud vela da. Aga mottham avan pannadu ella fraud vela. Now, there is a short commercial break. He went to jail. Interval. Till the interval, let's see whatever has happened. there was a very worst person. He got a land. On top of that land, he constructed the building. Now, inside the building, he kept the inventory. Now, with the inventory, how did he pay for inventory? He got the loan, but did he actually pay for inventory? He put it for deposits. No, but he maintained proper records and he also paid taxes to the government. That is the statutory dues. Now, the government is asking him the question, from where you got all the income? So much of unrecorded, undisclosed income is there. And the government said, I know all that you are doing, you better repay the loan immediately. But I already told you he's a very worst person. So he repaid the loan by way of issue proceeds. He got money from the public. He got that money. ஆக மொத்தம் பண்ணது எல்லாமே fraud வேலை தான். Now he went to jail. Now in the jail, you all tell me, when he comes back from jail, will he become a changed person? No chance. He was thinking what kind of fraud I can do inside the jail. So as soon as he came, he started a company called as Nidhi Company. Nidhi Company means these are companies which is made by the members for themselves. That is the meaning of Nidhi Company. Usually if you see Tamil Nadu, lots of Nidhi companies are there. Now he formed this Nidhi Company, and I told you he's a very worst person. And this Nidhi Company is by related parties. He put his mother, brother, father, father-in-law, sister's husband, everybody he put. All the related parties are forming the Nidhi Company. Now, when people came for internal audit, they found out 3 important areas where mistakes are happening. They said there is lots of non-cash transactions which is happening. This company is supposed to go for RBI registration, but they did not do that. So there is a mistake, they said. And they said there is a lot of losses which is happening in the company. So seeing all these things, the statutory auditor of the company got very scared. So that statutory auditor immediately went for his resignation of statutory auditor. Now, the resignation of statutory auditor happens and there is so much of losses which is happening. Now, definitely they understood, okay, my going concern is getting affected. Now, till here, let us see what has happened in the story. There was a very worst person who was there. He got a land and a building, and inside that he put his stock. Now, how he got the stock? By way of loans. Now, he got the loan and did he actually pay to the supplier? No, he gave for deposit to enjoy that money. But to show to the outside world, he acted like anything. All the records were properly maintained by him, but he got caught when he paid taxes to the government. Government said, I know what you are doing, you better repay the loans. They said, you better repay the loan. Now this guy decided, okay, fine, I will repay the loan and all of those things. But how did he repay the loan? That is the question. By way of public issue proceeds, he got the money and he repaid the loan. Agamatto, whatever he did is complete fraud only. Now he has gone to jail. When he came back from jail, will he be a changed person? No chance. He will be that very worst person only. He started a Nidhi company with related parties. When they came for internal audit, they found out 3 important areas where problems are happening. Non-cash transaction, RBI registration, and lots of losses are happening. Looking at this, the statutory auditor of the company went for resignation. Now looking at all of this, he understood that going concern is getting affected. Material uncertainty is there. Now is the turning point of the life. Now he decided, okay, whatever has happened. I will do nalladhu for the society, good for the society. So he took CSR activities, corporate social responsibilities. He suddenly became a changed man and he did the corporate social responsibility, and finally he did the consolidation of all his wealth, and he decided, okay, this is for society, this small portion is for myself. So now he is a better person. He did a consolidation. Now please be with me itself. The first clause is what? Fixed asset. What did this very worst person do? He got the land and the building. That is the first clause of fixed asset. Now he purchased the fixed asset and kept what inside? The saraku. That is nothing but the stock. Second clause is inventory. Third clause, how did he get the stock? By way of loans. Legs provided. There are two clauses for legs. Third clause is legs provided. Fourth clause is legs provided as per section 185 and section 186. Now he took the loan and he put it as deposits. That is deposits as per section 73 to 76. Is that clear, guys? Now he put the deposits, but he is maintaining proper records. The cost records is clause number 6, and for this we have a section number 148 subsection 1. Now he got caught when he paid the taxes to the government. That is a statutory dues, disputed statutory dues and the undisputed statutory dues. That is clause number 7 for you. Then what happened? He paid the statutory dues. Then government caught him and said, this is the last warning. There is so much of unrecorded income which is there. That is clause number 8. And they asked him to repay the loan. That is clause number 9. That is repayment of loan. Then how did he repay the loan? By way of issue proceeds. That is clause number 10. Issue proceeds. Aga mottham pannadellame fraud veladan. That is clause number 11. Now quickly going through everything. Clause number 1 is fixed assets. Clause number 2 is inventory. Clause number 3 is legs provided. 4 is legs provided as per section 185 and 186. Clause number 5 is deposits as per section 73 to 76. Clause number 6 is cost records. Section 148 subsection 1. Clause 7 is statutory dues split into disputed statutory dues, undisputed statutory dues. Clause number 8 is unrecorded income, undisclosed income. Clause number 9 is repayment of loan. Clause number 10 is issue proceeds, and clause 11 fraud. Now comes intermission. After he comes back from jail, what did he form? He formed a Nidhi company. With whom did he form that Nidhi company? With his brother, father, mother, sister, sister-in-law, father-in-law. They are the related parties. That is clause number 13. Related parties, he formed the Nidhi company. Now when they came for internal audit, that is clause 14, they found out 3 different things. That is 15, 16 and clause 17. What are those 3 different things? There are lots of non-cash transactions. RBI registration is to be there, and there is lots of losses. That is clause 17. Now looking at all these things, statutory auditor got scared and he resigned. The resignation of statutory auditor is clause number 18. Then seeing all these losses and everything, finally you can conclude that going concern itself is getting affected. Now is the turning point, and finally he gives all his money for nalladu for the society. That is clause 20, corporate social responsibility. 21 is he is seeing, okay, this much is there for me, that much is there for society. He is doing a consolidation of all his funds. That is consolidated financial statements. Is that clear, guys? Now is it easy to remember all the clauses? You all tell me. Now clause number 1 is what? Fixed assets. Clause number 2, inventory. 3, leaks provided. 4, leaks provided section 185, 186. Clause number 5, deposit section 73 to 76. Clause number 6, cost records section 148 subsection 1. Clause number 7, statutory dues, disputed statutory dues, undisputed statutory dues. Clause number 8, unrecorded income, undisclosed income. Clause number 9, repayment of loan. Yes, there is unrecorded income. The government gave him last warning and told him you better repay all your loan. That is clause number 9. 10 is how is he repaying? By way of issue proceeds. Agamattam pannadellame fraud veladan. That is clause number 11. 12 starts with Nidhi company. He is forming the Nidhi company with related party. That is clause 13. 14 is internal audit. 15, 16, 17 is what the internal auditor is finding. What is it? Non-cash transaction, RBI registration, and lots of losses. That is 17. 18 is resignation of statutory auditor. 19 is going concern. 20 is corporate social responsibility, and 21 consolidated financial statements. Very, very good, guys. Now you are done with the clause names. Now only you have to study what is there inside each of the clauses. Can we go inside? Can we go inside, guys? Yes. fixed assets. Now I'm going to make this very easy for you. There are 6 points which is given here. The first point is talking about records. The records of the tangible asset and the records for the intangible asset. Now for tangible asset, what kind of records are required? What are the details of that fixed asset and where is that fixed asset located? You please tell me the situation of that fixed asset, the location of that fixed asset. For example, the fixed asset is this projector. How will I say what is the situation of the fixed asset? You come to 3rd floor and then you come straight, take that right, and then you can see there is a big projector, there is a big screen, and then there is a projector. So these two are fixed assets like that. The details and also the situation is to be given by the auditor. Now, what is the second one? The intangible asset. For that, will there be situation? Intangible asset means there will not be situation. You will be giving only the full details of that intangible asset. So the first point is with regard to records of tangible and intangible asset. Asset na sonnale, you have to do the physical verification of asset. Physical verification, when you have to do at reasonable intervals, you have to do. Now, if there is any differences, that is in books of accounts, it is different. And when you went and did the physical verification, it is showing a different figure. If there is any differences, that is called as material discrepancy. If there is any discrepancies in the books of accounts and the what is there in real life, then you have to see whether it has been properly recorded with in the books of accounts. That is the next point. Third one is with regard to the title deeds. Whatever asset is shown in your books of accounts must be that of the companies only. The title should be with the company only. This is for immovable property. If it is not there in the if the title deed is not there, then there is a separate format that you have to follow where you have to give the details as to who is the person who is holding that immovable property for the company, and you will be giving reasons for the same, and so many other details are also there. The fourth one is there any revaluation of that fixed asset? Revaluation means increase or decrease of the value of the fixed asset. If that change is more than or equal to 10%, then you have to please mention that here. The next one is with regard to Benami Transactions Prohibition Act. What is the meaning of Benami? Benami means I am holding for someone else. So that is Benami Transactions Prohibition Act. Sorry for this guys. Benami Transactions Prohibition Act. If any cases are pending against the Benami Transaction Prohibition Act, as an auditor, we will have to comment on the same as per CARO reporting. Now there are only 5 points which is given here. See the text. Some disturbance is happening today. What is the issue? Fully they are writing. Close it. Okay. Now if you see the fixed assets, there are 6 points. The first 2 points are with records. Records of tangible asset and record of intangible asset. Whether a company is maintaining proper records showing particulars including quantitative details and situation of PPE, property, plant and equipment, that means tangible asset. Whether company is maintaining proper records showing full particulars of intangible asset. Whether these PPE has been physically verified by the management at reasonable intervals, whether any material discrepancy was noticed, whether it has been properly dealt with in the books of accounts. Then I told you about the title deeds of immovable property. If it is held by some other person, say for example, who is your favorite hero? It is held by Surya. No need that Dhanush. In every place if you see, they are spoiling his name like anything. We will take Surya. Description of the property. What is that property? It is a land and building. The carrying value is 3 crores. It is not held in the name of company. It is held in the name of Surya. Now, who is that Surya for that company? He is a relative of director. Like that you will have to give. What is the period held? 2 years. Reason for not being held in the name of company. What is the reason? You will have to mention that also. So, title deed of immovable property has to be in the name of the company. If it is not in the name of the company, then you have to give all of these details. whether the company has revalued if it's PPE, whether it is done by registered valuer, and if change is 10% or more, then you have to mention the carrying value of each class of PPE or intangible asset. And last we saw Benami Transactions Prohibition Act, whether any proceedings have been initiated or pending against the company. That means any case is pending against the company under the Benami Transactions Prohibition Act, then whether the company has disclosed that detail in the financial statements, we will have to say that also. There are 6 points which is given here. For our understanding, I gave that as just 5 points. This is fixed assets, guys. Going to the next clause, that is inventory. Inventory sonale physical verification of inventory must happen. Whether physical verification of inventory have been conducted at reasonable intervals by the management and where in the opinion of the auditor coverage is done. Now here also discrepancy can happen. When you go and physically verify something and in the books of accounts it is something else, you will call that as discrepancies. If that discrepancy is 10% or more, then whether they have been properly dealt with in the books of accounts. Whether during any point in time, this point is important, they can test in your exam. Whether during any point in time, the company has been sanctioned working capital limit in excess of 5 crore rupees. For you to understand this clause, let me tell you, any business for their operations, they can get the loan. Now say they have gotten that loan for working capital loan is for operations. If that loan amount is exceeding the 5 crore rupees, then they have to file something called as quarterly returns or statement. This has to be filed with the banks or financial institution. As an auditor, whatever they are filing with the banks or financial institution, whether it is as per the books of accounts only, because we've done the physical verification, and if the physical verification books of accounts will be checking, now the quarterly returns which is sent to the bank, whether it is as per the books of accounts. If not, we'll have to give the details. Now inventory, there are 2 points are there. First point is talking about physical verification. If there is any material discrepancy more than 10% in CARO reporting specifically, you will have to mention. The second point is talking about working capital loan. If it is exceeding 5 crore rupees in the quarterly returns, has to be given to the banks or financial institutions. Now as an auditor, we have to see whether that return is as per the books of accounts. If not, we will have to give the details. Third is leaks provided. Loans, investment, guarantees and securities. Under this, the first point is talking about, like how I did for fixed asset, I will explain this. Leaks provided, guys. The first point is talking about, you can give the loan to either your subsidiary, joint venture, associate, or to any other person, correct? Joint venture, subsidiary and associate, or you can give the loan to others, whomever it may be. You please mention the amount in aggregate as to how much you have given. That means you have given and they have repaid. Again you have given and they have repaid. So you will not calculate the outstanding amount, you will calculate the aggregate amount. So first you have to mention the amount in aggregate and you will have to mention the outstanding amount. That means the balance which is at the end of the year. So loan given to subsidiary, joint venture, associate, leaks provided to other than subsidiary, joint venture, associate, you will have to mention the amount in aggregate and the outstanding balance. Going to the second point, the loan which is given should not affect the interest of the company. Say normally I am charging people 10% on the loan, but if I am giving to my related party, can I charge that? No, they will give that slipper beat only. So it should not be prejudicial to the interest of the company. That it means it should not be affecting the interest of the company. Third, any loan you give, there should be, when will you be returning the loan? Will you ask that question? That means there must be a repayment schedule. That is the third point. Any loan which you give must have a repayment schedule. So the auditor has to check that repayment schedule, whether it is there or not there. If there is any amount which is overdue for a period of more than 90 days, how are they dealing with the books of accounts, and whether any actions have been taken for recovery of that loan, the auditor has to check. Apart from this, whether any loan has been renewed or fresh loan has been taken or any loan has been extended, then the auditor has to give the aggregate amount and the percentage of the total loan. Renewal, fresh loan and extension, when will that take place? Say for example, there is a loan which is given that is falling due today. Then today what I will do, okay, you're not able to pay the money back, I will renew it to the next year like that. Or you close this loan, I will give you a fresh loan. So basically they're carrying forward that loan. In that case, you will have to mention the aggregate amount and the percentage of the total loan. On demand loan. What is the meaning of on demand loan? You have to first understand. For example, you're giving money to your friend. Will you ask him back that money? No. You will give it now and you'll say, Macha, I'll get it back from you. What you'll say, whenever I want, I will take it back from you. So basically, on your demand, when you want, you will take it back from him. That is on demand loan. For this also, you will have to mention the aggregate amount and the percentage of the total loan. Is it understandable, guys? Now just see the points which is given here. Whether during the year the company has provided any loan or advance in the nature of loan, then indicate aggregate amount during the year and the balance outstanding with respect to LIGs provided to subsidiary, joint venture, associate. Is that clear? Now here, aggregate amount during the year, balance outstanding, same thing, the same thing, aggregate amount during the year, balance outstanding, you will have to mention if you have given loan other than subsidiary, joint venture, associate. Is that clear, guys? This was our first point. Whether you have given loan to subsidiary, joint venture, associate or other than subsidiary, joint venture, associate, you will have to mention the amount in aggregate and the outstanding loan value. This point is not applicable to company whose principal business is to give the loan. If your business, core nature of the business itself is to give the loan, then you can skip this point. What was the second one? Whether investment made, loans and advances given are not prejudicial to the interest of the company. In respect of loans and advances, the nature of loan, whether there is a schedule for repayment and whether it is regular. If there is any overdue amount more than 90 days, whether reasonable steps have been taken for the recovery of that overdue loan. Then the next point is regard to whether any loan has been renewed, extended or fresh loan. If you notice here in red what is given, this point also is not applicable for principal business being the giving of loan. So if any loan has been renewed or extended or fresh loan has been granted, then you have to mention the aggregate amount and the percentage of aggregate to the total. Whether the company has granted loans or advances which are repayable on demand or without specifying terms, without period of repayment, when you will give to all these people, only if they are friends, only if they are family members. You cannot say repay tomorrow, like that you will not say. So it is repayable on demand. If so, specify aggregate amount and percentage of total loans granted, aggregate amount of loans granted to promoters and related parties. There are 6 points which is given here. First one is talking about loans given to subsidiary, joint venture, associate other than subsidiary, joint venture, associate. You will be mentioning the amount in aggregate and the outstanding balance. You will see that the loan is not prejudicial to the interest of the company if it is overdue more than 90 days, whether steps have been taken, reasonable actions have been taken for the recovery of the loan. If there is any loan which is given, whether there is repayment schedule of the loan, the auditor has to check whether any loan has been renewed or fresh loan given or extended, or if there is any on-demand loan which is given, you will have to mention the aggregate amount and the percentage of the total loan. This is LIGs provided, guys. Clause number 4 is very, very easy. If you have to remember the section number, nothing else you have to remember. So LIGs provided as per section 185, 186. Deposits I told you, section 73 to 76, not 36. 73 to 76. Cost records, section 148, subsection 1. Basically what is written here, whether maintenance of cost records are as per section 148, subsection 1 of the Companies Act and whether such accounts have been made and maintained. Statutory dues. Disputed statutory dues, undisputed statutory dues. Now you have to know what is the meaning of disputed statutory dues and undisputed statutory dues. What is the issue? Now say for example, you have to pay taxes to the government. Your GST has crossed 20 lakhs, so you have to pay the GST. You will be collecting from somebody else and you will be paying that GST. Say for example, you have paid 2 lakh rupees as GST value. You have collected from the customer and you have given to them 2 lakh rupees of GST. Now, you are getting a notice from the government saying the way you have calculated the GST is wrong. Instead of 2 lakhs, you have to pay 5 lakhs. Will you accept this? No. You will go and fight in the court of law. That means there is a dispute which is happening. Dispute means you are fighting with the government. So disputed statutory dues means, I hope you understood what is the meaning of disputed statutory dues. What is undisputed statutory dues? Undisputed statutory dues means the due is overdue. Say for example, TDS has to be paid by 7th of the next month, and GST also, there is a timeline for paying to the government. Now the due date of the payment has crossed. Now there is no dispute which is here, but still I know that I have to pay to the government. I know I will be paying later, maybe with interest and penalty. That is called as undisputed statutory dues. Undisputed statutory dues means it is outstanding more than 6 months from the time it became payable. Disputed statutory dues, you already know that fight is going on between the numbers or whatever which is happening. Now here you have to mention the amount involved. Here how much is dispute? 5 lakhs? No, wrong. The disputed amount is 3 lakhs. You have to mention the amount involved and also the forum where the dispute is pending. Forum means where is the dispute pending? It is pending in tribunal, it is pending in high court, it is pending in supreme court, like that you will be able to say. So the forum where the dispute is pending also should be mentioned. There is clause number 7, statutory dues. Undisputed statutory dues, whether the company is regular in depositing undisputed statutory dues, including GST, PF, sales tax, employee state and customs, excise duty and other statutory dues. If not, extent of arrears of outstanding due on the last day of the financial year concerned for a period of more than 6 months from the date they became payable. From the due date, if it is outstanding for more than 6 months, then at that time you will have to mention here. Disputed statutory dues, where statutory dues have not been deposited on account of any dispute, then the amounts involved and the forum where dispute is pending shall be mentioned. Is that clear, guys? This is clause number 7, statutory dues, disputed and undisputed statutory dues. Clause number 8 is undisclosed income, unrecorded income. In the previous year, you have not recorded as income, and in the current year, you are suddenly showing this as income. You are showing this to tax, putting your income to tax. In that case, whether a transaction which is not recorded in the books of accounts have surrendered or disclosed during the year in the tax assessment, then previously unrecorded income, whether it has been properly recorded in the books of accounts during the year, you will have to see. This is clause number 8, undisclosed income. Coming to clause number 9, repayment of loan. It looks big, don't get scared. I am there for you, like how fixed assets look big initially. The remembering of CARO clauses looks big initially. Now you are able to tell like that. Please be with me. Please trust me. CARO is one of the easiest chapter where you can easily score 4 or 5 marks. Compulsory 4 or 5 marks. Attempt on attempt they are asking in CARO. Let's be ready, guys. Clause number 9. Repayment of loan. Whether company has defaulted in repayment of loan or borrowing or in the payment of interest. If yes, period and amount of default should be as per the format. What are they asking in the format? Nature of borrowing, including the debt securities. Name of the lender, from whom you got the money. Amount not paid on due date, 1 crore I have not paid. Whether it is principal or interest, it is both principal and interest amount. Number of days unpaid, it is not paid for more than 3 years. Remarks, if any, like this. In the format, you will have to mention if there is any default in the repayment of loan. Clause number 9 is talking about repayment of loan. Under that, the first point is talking about default in the repayment of loan. What is the second point? Whether this person is a willful defaulter. What is the meaning of willful defaulter? Willful defaulter basically means vechite illan solran. Who will do like that? He has lots of money, but he will not pay to the bank. For example, Vijay Mallya, Nirav Modi, do they have money? Definitely they have the money. Nirav Modi, Punjab National Bank, lots of case happened. Vijay Mallya, the whole country knows, especially now after the podcast. Yes or no? He had the money, but still he went and he partied for his 60th birthday like anything. But he did not pay to the bankers. But he has a different story. That is a different story. Now, willful defaulter means vechite illan solran. That is willful defaulter. Under repayment of loan, we saw if the company has been defaulted, whether in terms of loan or in terms of interest amount, then we had a format below. Second is whether he is a willful defaulter. If the company has gotten the term loan facility, now when you are getting the term loan, there will be the purpose of the loan. Say if you go for housing finance loan, whether you are building the house or not, they will be checking. So if they have gotten a term loan, whether it has been used for the purpose for which it has been bought. If it is not used, the auditor has to mention the amount which has been diverted and the purpose for which it is actually used. The auditor has to report on that. Whether short-term loan has been used for long-term purposes, this is a big problem. Let me tell you why. The ulta is not a problem. Only if you use short-term loan for long-term purposes, it is a problem. Short-term loan means what? It is a loan which has to be repaid within a period of 12 months. Now, long-term purpose, if you are going to use the loan, for example, short-term loan you bought for working capital requirement, but you are actually using that for building a building. You are using that for building a building. Now, in that case, when will that building actually give you the return? Maybe after 3 years, maybe after 4 years. So the benefit from that property is going to come only after 4 years, whereas you have to pay the money within a period of 12 months. So you cannot use short-term loan for long-term purposes because there might be a possibility of default here because the benefit from that long-term purpose will be much more after 12 months. So the short-term loans, if it is used for long-term purpose, the auditor has to mention that. Now comes again subsidiary joint venture associate. Say for example, I am taking the money, but this is for the use of subsidiary joint venture associate. In that case, you please mention that is the taken funds to meet the obligation of subsidiary joint venture or associate. Or the other way is also possible. I am using the collateral of subsidiary joint venture associate. That means what? I am using the securities which I have in the subsidiary as the collateral. And I am getting the loan for myself. That is the next point. In case you are raising the loan with pledge of securities. This is terrible today. With the pledge of securities, you are getting the loan which is held in subsidiary joint venture or associate. Then in that case, whether there is a default, details of the default if there is any, because if there is a default, there is a serious scenario. What is your collateral? Securities in the subsidiary joint venture associate. Then if you are going to keep that as the collateral and if you default in payment of loan, they are going to take the shares. You are no more the holding company. That is the reason why it is very, very important. Now, under clause number 9, repayment of loan, we saw how many points? 6 points. The first one is whether the company has defaulted in the payment of loan or interest. For this only we saw there was a format. Second, whether the company is declared as a willful defaulter. I hope you know what is the meaning of willful defaulter. He has the money, but he will say, no, I will not pay the money to you. Third is, what is the purpose of the term loan you have obtained, whether you have actually used for that purpose only. If you have diverted the money to some other purpose, then you please mention what is the amount diverted and what is the purpose for which it is used. Fourth is whether short-term loan has been used for long-term purposes. I told you why it should not be used that way. Fifth is whether you have taken the funds to meet the obligation in the subsidiary joint venture associate. And the last is whether you have raised the loan with pledge of securities in subsidiary joint venture associate. So if you see, the fifth and sixth point might be a little confusing. Fifth is the company, that is your client, your company has taken the loan from the bank, but for whom? It is actually for subsidiary joint venture associate. So basically the loan is coming here and ultimately it is going to subsidiary joint venture associate. This is the fifth point. Now if you see the sixth point, you are raising the loan with the pledge of securities which is held in the subsidiary joint venture associate. So here the loan is coming to the company, and the company is basically giving the collateral as what? As the securities which is there in subsidiary joint venture associate. That is the 6th point. I hope it is clear now for you. Read the text. Whether company has defaulted in repayment of loan or other borrowings and payment of interest. If yes, then you have to mention the format. Whether the company is declared as willful defaulter by a bank or financial institution or other lender. Whether term loans were applied for the purpose for which the loans were obtained, then what is the amount of loan diverted and what is the purpose it is used for. Whether funds raised on short-term basis have been used for long-term purposes and mention the amount and the nature. Whether company has taken any funds from any entity to meet the obligation of subsidiary joint venture associate, then you will be giving the nature of transaction and amount. Whether company has raised loan on the pledge of securities held in subsidiary joint venture associate, then you will be giving the details, and whether any default has happened. Here, if you are going to pledge the securities in subsidiary joint venture associate, you are more bothered whether there is a default, because if there is a default, you are no more the holding of that subsidiary company. Going to clause number 10, guys. Clause number 10 is issue proceeds, that is IPO and FPO. Is it too much? Do you want a short commercial break? No? Okay, good. We are revising, right? We are seeing there and then we are coming to the text. We are again revising. I hope it is okay. Clause number 10. Issue proceeds, IPO and FPO. Whether money raised by way of IPO or FPO were applied for same purpose is important. And the second point is easy. Section 42. Section 62. I told you whenever there is a section, you only have to remember the section number. So the first point is talking about if you are raising money from the public, you will be having a purpose for that. Now where will you give that purpose? In the prospectus, you will be giving the purpose as to why you are raising the money from the public. Now as an auditor, you will have to check whether if they have gone for any IPO or FPO. What is the difference between IPO and FPO? IPO is initial public offer. FPO is further public offer. I didn't ask the abbreviation. I asked the meaning. So when a company gets listed on the stock exchange, the first time they are raising funds from the public, that is called as IPO. Now multiple times when they start raising funds from the public, it is called as FPO. The second, third, fourth time that they are raising funds, that is called as further public offer. Initial means first time, initial public offer. What is clause number 11? There are 3 points which is given here. 11 is fraud. Whether they are covering fraud by the company or somebody else doing the fraud on the company. They are covering both as per CARO. If there is any fraud by the company or on the company, you please report it under CARO. They are also giving a section number here. 143 subsection 12 of the Companies Act. What is that 143 subsection 12 of the Companies Act? Very, very important. 143 subsection 12 says, if the amount of fraud involved is less than 1 crore, you please report to Board of Directors and the Audit Committee. If the amount of fraud is more than or equal to 1 crore, then you please take the form number ADT4 and you directly tell the central government. Now this you have to remember, 143 subsection 12. Whether any report under section 143 subsection 12 has been filed in form ADT4 as prescribed under Rule 13 of the Company Auditor Rules. Whether auditor has considered any whistleblower complaints. What is that whistleblower complaint? Now, sometime back, you know what happened? She was eating in the class. What that Sanjay Ram did? Ma'am, eating, ma'am. Like that, pot kuduthu fine. That is called as whistleblower. I did not see her eating. But because that Sanjay Ramasamy did that, ma'am, eating. Like that he did. Because of that I know, okay, she is not listening to this class. She is eating there. So suddenly I will raise my voice. Then okay, ma'am saw something. Everyone will become suddenly attentive. Yes or no? Whistleblower means if some fraud is happening, there will be one person or two people in the employees who will blow the whistle and tell the others that something else has happened here, that a fraud has happened here. That is called as whistleblower complaints. Under fraud, there were 3 points. Whether any fraud by the company or any fraud on the company has been noticed or reported. Whether any report under section 143 subsection 12 of the Companies Act has been filed. Whether auditor has considered any whistleblower complaints. This is clause number 11, fraud. Now after this, what happens in our story? He goes to jail and there is interval. Now again there is interval. We will go back to the first clause and we will quickly revise as to what we saw till here. Fixed assets, there are 5 points totally. First point is talking about records, records of tangible, records of intangible asset. Tangible means the situation and the details has to be given. Intangible means full particulars, that is only the details is required. The second point is physical verification of the asset, whether any material discrepancy is there, whether it has been properly dealt with in the books of accounts. Third is who is the title, who is the owner, real owner, title deeds of that immovable property. For this separate format is given in case the asset is not held in the name of the company. If there is any PP which has been revalued and that revaluation change is more than 10%, then you have to mention the net carrying value and also the net carrying value of each class of PPE. And last is Benami Transaction Prohibition Act. If there is any case which is pending, proceedings pending against the Benami Transaction Prohibition Act, then you have to mention that separately. Clause number 2 is inventory. We have 2 points here. One is about physical verification of inventory, material change more than 10%. You'll have to see. Then next is working capital loan. This loan, if they have obtained the loan for more than 5 crores, then the quarterly returns has to be filed with the banks and financial institution. We as auditor have to see whether these returns have been filed and whether it is as per the books of accounts of the company. Clause number 3 is leaks provided. Point number 1. Whether leaks provided to subsidiary joint venture associate or other than subsidiary joint venture associate, you have to mention the amount outstanding and the aggregate amount. Whether any leaks are provided are prejudicial to the interest of the company. Whether the leaks have a repayment schedule and whether the receipts are regular. Whether it is overdue more than 90 days. If it is overdue more than 90 days, what is the steps which is taken by the management for getting the amount? Whether any loan has been renewed or extended or fresh loan has been taken, then this point is not applicable for companies where the principal business is to give the loan itself. Then you have to mention the percentage of aggregate to total loans or advances. The last one also same thing you have to mention, that is aggregate amount and percentage of total loan to advances, that is repayable on demand loan. Now these 6 points are for leaks provided. Fourth clause is leaks provided as per section 185, 186. Fifth clause is deposits under section 73 to 76. Sixth is cost accounts as per section 148 subsection 1. Seventh is statutory dues, disputed and undisputed statutory dues. Dispute means there is some fight going on, so you have to mention the amount and the forum involved. Undisputed statutory dues means there is no fight and all, it is just overdue more than the 6-month period. Undisclosed income, previous year it is unrecorded, undisclosed, and current year suddenly you are recording it. Whether it has been properly dealt with in the books of accounts, auditor has to see. Clause number 9 is repayment of loan. There are just 6 points here. Whether the company has been defaulted in the repayment of loan, whether the principal amount is defaulted or interest amount is defaulted, all those things in the format given below. Whether the company has been declared as willful defaulter, the auditor has to check. Whether term loan is applied for the purpose for which it has been obtained. Otherwise, what is the amount which has been diverted and what is the purpose for which it has been diverted for. Whether short-term loans has been obtained for long-term purposes, then auditor has to mention that if the company has taken the funds to meet the obligation of subsidiary joint venture associate, or if they have raised the loan with the pledge of the securities in the subsidiary joint venture associate, then in that case also you will have to mention that separately. Clause number 10, issue proceeds, IPO, FPO, what is the purpose for which you have obtained, whether you have used for the same purpose. This is by public issue. Section 42 and 62, whether it has been complied with. Clause number 11, whether any fraud by the company or on the company has happened, you'll have to mention 143 subsection 12 says that if the amount of fraud is less than 1 crore, you have to tell the board of directors and audit committee. If the amount of fraud is more than or equal to 1 crore, then you have to mention in form ADT 4 to the central government. Very good. The last one is whether auditor has considered any whistleblower complaints. That also you'll have to check. Is that clear, guys? Can we move forward to the 12th clause? Clause number 12 is Nidhi company. There are just 3 rules here, actually 2 rules, because the third one is whether any default in repayment. What are the first 2 rules? Net owned funds is to deposits has to be in the ratio of 1:20. That is the first rule. Now, do you all know what is the meaning of Nidhi company? Nidhi company means, do you all know? Okay. Nidhi company means this company is actually very This company is actually very prevalent in Tamil Nadu. What is this Nidhi company? This company is basically a few members will come together and they will give the deposits, and between them they will take the loan from the company. Say for example 10 people are coming together. In that 7 people are okay, they'll give the deposits, and all 10 can take the money back as borrowings, or like that. It is basically by the company for the company, like that you can remember. Now they also take deposits from outsiders, but loan is given to the members of that Nidhi company. Whether Nidhi company has complied with net owned funds is to deposits in the ratio 1:20, and they have to maintain a 10% of unencumbered term deposits. What is the meaning of unencumbered term deposit? Encumbrance means what? A charge, good, a lien, a charge which is created on the asset. Same way, in a deposit also you can create a charge. Based on a deposit, you can take overdraft facility, you can take that, but maintain 10% of unencumbered term deposits. So these three are for Nidhi company. Clause number 13, related party transaction. You just have to remember the section number, section 177, section 188. Clause number 14 is internal audit. Whether the company has an internal audit system which is commensurate with the size and nature of the business. Say for example, Audi is a company, it has rupees 4,000 crores turnover. Now you all tell me, in that okay, I'm not even writing, 4,000 crores of turnover, I have an internal auditor, only 2 people are there. Is it okay? No, at least 25 members has to be there in the internal audit team. That only the first point the auditor has to check, whether company has an internal audit system which is commensurate with the size and nature of the business. Whether the report of internal auditor has been considered by the statutory auditor. That is the second point. Now internal audit, there are 2 points. Whether the company has an internal audit system which is commensurate with the size and nature of the business. The second is whether the report of that internal auditor has been considered by the statutory auditor. Clause number 15 is non-cash transactions under section 192. If there is section, then there is always only the section. Only here there is something else which you have to remember. The non-cash transactions with directors or any person who is connected with the director. Section 192 is talking only about that. Any director or any person who is connected with the director. Clause number 16 is RBI registration. RBI registration, if it is required under section 45 IA of the RBI Act, then that company has to get registered under that. That means what? They are doing the banking activities, then they have to register under RBI. If they are undertaking any kind of activity, then that registration has to be obtained. So if the company you are going for audit, whether they have to be registered under section 45 of the RBI Act. What is the meaning of housing finance activities? For buying a house, I am giving the loan. Now what am I called? So the second point is with regard to whether the company has undertaken any non-banking financial or housing financial activities without a certificate from the RBI. The next 2 points is actually considered as 1 point only, because it is talking about core investment company. Now you all take this group called Tata Group. My favorite example. Who and all are there under Tata Group? TCS is there. Tata Steel is there. FMCG is there. Who else is there, guys? Tata Fashions. Yes, Tata Fashions. Westside Zudio is there. Starbucks is there. That is also franchisee of Tata. So all these companies come under Tata Group. Now, core investment company means there is one company at the top which is holding in all the other companies. That company is called as Tata Sons. Now this Tata Sons is holding in all the other companies. This Tata Sons is called as core investment company. As an auditor, we have to see that whether the company is a core investment company, that is the company that you are doing the audit for, whether that is a core investment company. The second point is also related to core investment company, where in the group are there core investment company. Usually there will be only one. Now you have to mention the number of core investment companies which is part of the group. Is that clear, guys? RBI registration 4 points illa 3 points. First one is talking about whether the company is required to be registered under section 45 of the RBI Act. Second point is talking about whether the company undertakes non-banking financial activities or housing financial activities. Then valid certificate from RBI, do they have or not? The third point is talking about whether the company is a core investment company. Fourth is, no, third only. Third is, if in the group there are core investment company, how many core investment companies are there? That is RBI registration. Clause number 17 is talking about cash losses. What is the meaning of cash loss? Say there is profit after tax. You will be adding all the non-cash expenses. What are the non-cash expense? Your depreciation is a non-cash expense. Anything else? Your provisions, they are also non-cash expense only. Your provisions for bad and doubtful debts and all the other provisions. Now if you add the non-cash expenses, you will get the cash profit. Now in case here there is cash loss, then you have to mention that. Even if there was a cash loss in the previous year, you have to mention that in the current year CARO reporting. Whether the company has incurred cash losses in the financial year and the immediately preceding financial year. If so, state the amount of cash loss. You will be seeing the cash loss in the current year and you will be seeing the cash loss in the previous year. Clause number 18 is resignation of statutory auditor. In case you are the statutory auditor, before 2 months only you got appointed. Before that there was one more person. Why he resigned? Did they keep the knife on his throat and say put the signature here? You need to communicate with him and understand as to why he left the company. Now if there was a resignation during the year, you will have to ask the issues, the objections and the concerns which is raised by the outgoing auditor. What is going concern? Now in going concern, SA 570 அங்கேயே பிரிச்சு மேஞ்சிட்டோம். What we saw there? Financial indicators, operating indicators and other indicators on the basis of financial ratio, aging and expected date of realization of financial assets and payment of financial liability. Whether the auditor is of the opinion that no material uncertainty exists, there is no 50-50 probability, you will have to mention that. And any liability, if it is there, whether they are able to pay that liability off within a period of 12 months, only then you will say that the going concern is okay. So as an auditor in CARO reporting, you have to mention about going concern. Last two are there. Let us complete it, guys. CSR. CSR is split into two. What is this corporate social responsibility? First of all, for companies which is having net profit more than 5 crores. So net profit more than 5 crores means it's a big company. That means avan naattukku nalladhu pannatom. Average profit 2% you take. The average net profit for the last 3-year period, you take that, and 2% of that average net profit for the last 3 years, you will be putting that for nalladhu for the society. That is corporate social responsibility. Now say you are building a school for all the underprivileged children. Now building a school will take how many years? 2 years? Yes, 1.5 to 2 years it will take. Now say you are building a big school and it is taking 2 years. Okay, it is an ongoing project. Now these funds has to be exhausted fast because this 2% will be like 1 crore or something. Now this 1 crore you are building a school, it has to be exhausted fastly. Now in case the project is still ongoing and continuing for more than 1 year, then you have to transfer that amount to a special account, and this is said in section 135 subsection 6. Whether in respect of other than ongoing project, the company has transferred the unspent amount to a fund. That means the school work is completed. For the school you thought it will be 1 crore, but it actually got over in 70 lakhs. So 30 lakhs is what? It is a completed project. It is not an ongoing project. So other than ongoing project, you have to transfer the unspent amount to a specific fund within a period of 6 months from the expiry of financial year. This is given in section 135 subsection 5. Is that clear, guys? So CSR means you will split it into two: ongoing project, other than ongoing project. Ongoing project means you have to transfer that to a special account. This is given in 135 subsection 6. Other than ongoing project means fund is over, but still you have, work is over, but still you have remaining funds. At that time you have to transfer that to a specific fund as per schedule 7 within a period of 6 months to the expiry of the financial year. That is CSR. Clause 21, the last clause, is consolidated financial statements. Under CARO, in the consolidated financial statement, there will be an independent auditor's report for the consolidated financial statement. Now, there also there will be CARO reporting. Under CARO, if there is a qualification or adverse remark when they are doing the consolidated financial statement, then in this client company, you please mention details of that company and the para number. Enough. You don't have to mention in detail and all. You just tell which company and what is the para number for that consolidated financial statements. Is that clear, guys? Now, let me do a quick revision after interval. Nidhi company to a clause number 12 has 3 points. Net own funds is to deposit should be maintained in the ratio of 1:20. They should be maintaining at least 10% unencumbered term deposits with them. Any default in repayment of the payment, if it is there, you'll have to mention that separately. Clause number 13 is related party transaction section 177, 188. Clause number 14 is internal auditor, whether the company has an internal audit which is commensurate with the size and nature of the business. The second point is whether the internal audit report has been considered by the statutory auditor. The next 3 points is actually what the internal auditor is finding in our story, in our very first person story. Clause number 15 is non-cash transactions as per section 192. I told you one more thing you have to remember, non-cash transaction which has been entered with directors or persons who is related to the directors. Clause number 16 is RBI registration. There are 3 points which is given here. First point is whether the company is required to be registered under section 45 IA of the RBI Act. Whether the company is involved in any non-banking or housing financial activities, then whether valid certification whether they have from RBI. Third is with regard to core investment company, whether this company that you are auditing is a core investment company or whether the group has core investment company. How many? You have to mention the number of CICs which is part of the group. Clause number 17 is cash losses. Cash loss means you will take the profit after tax. You will add all the non-cash expenses to get the cash profit or cash loss. You will be mentioning for the current year and also for the immediately preceding year. Very good. Clause number 18, resignation of statutory auditor. If there is a statutory auditor who has been resigned in that current period, then you have to mention the if there is any issues or objection or concerns which is raised by the outgoing auditor, we have to consider that. Clause number 19 is going concern. Whether the company is able to pay off all the liabilities within a period of uncertainty, whether they have no material uncertainty as on the date of audit report. That is important. As on the date of audit report, that company is capable of meeting its liabilities at the date of balance sheet. Now, whatever liability is there in the 31st March in the balance sheet, they should be capable to pay it off within a period of 12 months. And there should not be any material uncertainty when I am signing the audit report. Otherwise, what will come into place? Subsequent event. Very good, guys. I'm very happy you have understood the concept actually. Then subsequent event will come into place. So, no material uncertainty should have existed when you are signing on the date of audit report. That company is capable of meeting the existing liability as on the date of balance sheet. That is 31st March you have the liability. Whether they are capable of meeting that in a period of 1 year. CSR other than ongoing project. Other than ongoing project means the unspent amount they have to transfer to that special account within a period of 6 months to the expiry of financial year. Ongoing project means still it is ongoing, so you will be transferring that to a special account in compliance with 135 subsection 6. To a clause number 21 is consolidated financial statement. Under CARO reporting, in the consolidated financial statement, is there any adverse remark? If it is there, give me the details of the company and under what para number there was an adverse remark you will have to give. This is clause number 21 and we are done with CARO. No, எல்லாம் முடிச்சு கடைசியில மண்டை மேல இருக்கிற கொண்டைய மறக்க கூடாது. What is that கொண்டை? It is the applicability. Can we finish the applicability? Very easy. Just be with me, guys. It shall refer to every company, including a foreign company. Including whom? Foreign company. Basically, for remembering the applicability, you can remember it as any company which is big. Like public company, compulsory CARO has to be there. Big companies, compulsory has to be there. Like that you can remember, just be with me. It shall refer to every company, including a foreign company, except banking company as defined in section 5C of Banking Regulation Act, insurance company as defined under Insurance Act, company licensed to operate under section 188, one-person company and small company. What did I tell you? Small company ayirunda, it is exempt. Now we are reading the exceptions. It shall refer to every company including the foreign company except banking company, insurance company, section 8 company, one-person company, small company, and private limited company if they have the following criteria. Now, before I go to that private limited criteria, what is the definition of small company? Small company means what? Small company means the paid up share capital is less than or equal to 4 crores and turnover in the previous year is less than or equal to 40 crores. Please write down, I am not able to write here. The paid up share capital is less than or equal to 4 crores and turnover in the previous year is less than or equal to 40 crores. If you see, I use the word and. So both the conditions has to be satisfied to fall into small company. If it is a small company, then CARO is not applicable. Is that clear? Going to the private limited company. The private limited company not being a subsidiary or holding company of a public company. That means what? First I will explain this part. Now this is a private limited company. Your client is a private limited company. Now there is a holding company which is a public company. Public company means big company. Now in the holding company, if there is a big company, now automatically for your client also CARO becomes applicable. Is that clear? Now say for example your client is there and there is a subsidiary company and this is a public company. In this case also CARO becomes applicable. Basically public company ni engayavadhu vandale CARO becomes applicable. Can you remember like that? It should not be this company. Your client company should not be a public company. Your holding company should not be a public company. Your subsidiary company also should not be a public company. So see here, a private limited company not being a subsidiary or holding of a public company which is having paid up capital and reserves and surplus not more than 1 crore rupees. Not more than means less than or equal to 1 crore rupees as on balance sheet date. What are they saying? Paid up plus reserves and surplus should be less than or equal to 1 crore. That is the first condition. And what is the second one? Which does not have total borrowing exceeding 1 crore rupees from bank or financial institution at any point in time during the financial year. What is the second point which is saying? Paid up capital and the second point is saying borrowings should be less than or equal to 1 crore rupees, and this borrowing can be from banks or financial institution, and they are saying at any point in time. That means you have to take the aggregate borrowing in hand. Which does not have a total revenue. Your revenue is less than or equal to 10 crore rupees, and again here and. So both are and. All three conditions if they satisfy, then they are very small company. Paid up share capital and reserves less than or equal to 1 crore. Borrowings less than 1 crore and revenue also less than 10 crores. They are very, very small company. So usually I'll tell you where you'll get confused. Small company means paid up capital less than 4 crores and revenue less than or equal to 40 crores. Now there will purposely they'll make you do all the calculation and it will be paid up share capital will be more than 1 crore. Say for example paid up share capital is 2 crores. Borrowing is 3 crores and revenue is 20 crores. Now you tell me whether CARO is applicable or not. You will see all of these limits and you will say yes, CARO is applicable. But I am telling you CARO is not applicable because this is a small company. The paid up capital is 2 crores. The limit is 4 crores. The revenue is 20 crores. The limit is 40 crores. So this comes as a small company. So CARO will not be applicable for one-person company, small company, and if it is a private limited company having paid up capital reserves and surplus less than or equal to 1 crore, borrowings less than or equal to 1 crore and revenue less than or equal to 10 crores, that means it is a smaller company. So CARO will not be applicable. Is that clear? Did you understand this question that I told you? Purposely they will ask like this. They'll make you do these things and you will be like, yes, CARO is applicable. No. You also have to see small company limits. Is that clear, guys? Now, what did we see in applicability? It shall include all companies CARO is applicable, including a foreign company CARO is applicable, except for banking company, insurance company, Section 8 company, or a private limited company, one person company and small company, or if it is a private limited company under the limits. What are these limits? Paid up share capital plus reserves and surplus less than or equal to 1 crore. Borrowing from banks and financial institution at any point in time less than or equal to 1 crore. And revenue, including revenue from discontinuing operation. Just because it's discontinuing does not mean it's not the revenue. So revenue including discontinuing operation less than or equal to 10 crores. If all these three conditions are satisfied, then CARO is not applicable. If it is more than these three, then only CARO becomes applicable after seeing small company limits. Are you all with me? Purida, Velangida, Sollu, please tell me, do you understand? Yes. Now we are done with CARO. Now one small thing I want to show you. Let me show you the Wipro audit report. I'll show you how it comes in CARO. See here, CARO is basically in SA 700. You would have seen report on other legal and regulatory requirements. Under this only CARO comes. Now if you see here, they would have mentioned as per company's audit report order. It is mentioned in Annexure B. You please go to Annexure B, they have told. Now I am going to Annexure B. In Annexure B, clause number 1, what did we see? PPE. In respect of PPE, company has maintained proper record showing full particulars and also situation of PPE. Company has maintained proper record showing full particulars of intangible asset. They have that physical verification. That is the second point. What is the third one? Title deed of the immovable property. It is in the name of the company except for freehold land. See the last sentence. Except for freehold land. Carrying amount is how much? 404 million, for which the title deed is not executed in the name of company. They have not revalued anything, so no problem. And under Benami Transaction Prohibition Act, no proceedings have been initiated. Is that clear? Clause number 1. What was clause number 2? Inventories, physical verification, no discrepancy of 10%. Clause number 2, point number B. Working capital loan of excess of 5 crores. Do they have? Company has not been sanctioned. Clause number 3, loans, investment guarantee securities. Company has not provided any loan or advance in nature of loan. Investments made during the year are not prejudicial to company's interest. In respect of loan, the schedule of repayment of principal and payment of interest has been stipulated and repayment has been as per the stipulations only. Based on audit procedures performed, there is no overdue amount as on balance sheet date. What is the next point? Loan which is given to subsidiary joint venture associate. Is it there? Yes, they have given to Wipro. Have they shown the aggregate amount and the percentage of the aggregate to total loan? See here guys, whether or not point is there, CARO reporting is compulsory if it is applicable to you. That is, if you are a big company, private limited means it has to be big company, or if it's a public company, CARO automatically becomes applicable. You have to mention the aggregate amount and the percentage to the aggregate amount. Wipro LLC, they have given some 12,326 million. See here, million. Percentage is 99% of the total loan they have given to Wipro LLC. Now, according to information and explanation given to us and based on the company has not granted any loans repayable on demand. All clauses covered. Then going to all points covered in clause number 3. 4 is they have complied with section 185, 186. Clause number 5 is deposits as per section 73 to 76. Clause number 6, cost records as per section 148 subsection 1. Clause number 7, in respect of statutory dues, what is there? Undisputed statutory dues? No undisputed statutory dues is there. What is the statutory due which is there? So many. So many are there, and see the amount. Actually, they have to give only the forum where it is pending and the amount involved, but they have also given amount not deposited, period to which it relates, nature of dues. Yes, you see here 343 million. Is it in million? Yes. 343 million is pending with the Commissioner Appeals, the Customs Act. In which year? 97, 98. For so many years, dispute is happening. This is the disputed statutory dues. Anything recent is there? Recent? Oh, I have taken 23. So, maximum itself is 21, 22. So, Goods and Service Tax Commissioner Appeals, 930 million is under dispute. So, all of these things have they told? Clause number 8 is what? No unrecorded income which is surrendered during the year. Clause number 9, repayment of loan. Company has not defaulted in the repayment of loan. Company has not been declared as willful defaulter. Company has not taken any loan where it is not applicable. Okay, leave that. Fourth point is overall examination funds raised on short-term basis not been used for long-term purpose. Company has not taken any funds for obligation of subsidiary joint venture, and the other one also it is not there. Clause number 10 is what? IPFPO section 60-42, whether they have mentioned that and for the purpose for which is that obtained only. They have said that if they have not raised the funds, so point itself is not there. Clause number 11 is what? No fraud by the company and no material fraud on the company also. 143 subsection 12, no report is there. Whether any whistleblower, yes, we have taken into consideration whistleblower complaints during the year. Company is not a Nidhi company, clause 12 is not there. Clause 13, related party, section 177, 188. Clause 14, in our opinion, company has adequate internal audit system. Now guys, when you become auditors, you have to prepare this CARO reporting. You will definitely become auditor of big company, yes or no? So definitely, you will be preparing this report like this. Clause number 13, related party section 177, 188. Clause number 14, company has adequate internal audit system and they have considered the report. Clause 15 is what? Section 192. Clause 16 is what? RBI registration and all. All of those things is given. No resignation of statutory auditor. They have considered going concern. Nothing is there problematic. CSR also, they have no unspent amount. All of these points, they have given all the 21 clauses you have to mention. I hope after seeing a real audit report, you got the full clarity with respect to CARO, guys. Yes or no? Yes. Are you able to appreciate the subject? Are you able to appreciate what is CARO? Why you have to do this? Guys, 700 basically says what and all should be there in independent auditor's report. CARO is something, specifically these 21 points are important. So as an auditor, you give importance to these areas and you please tell me what is happening in these 21 areas. Like that, it is an additional reporting requirement. Is that clear? With this, the CARO comes to an end.
600 guys, using the work of an other auditor. Previously, I have shown you how to remember 600 and 610. This is using the work of an other auditor. That's why it is 600. If it is internal auditor, it is 610. Now we're going to focus only on using the work of an other auditor. Now here with respect to this standard, it is split into three basically. There are three definitions that you have to remember. What are the audit procedures that you have to take care? And lastly, three section numbers that you have to remember. I'm going to start off with the three section numbers, that is 128 subsection 1, 128 subsection 2 and 143 subsection 8. Once we finish these three sections and then we'll go to definitions and then we'll go to procedures by the principal auditor. Now 128 subsection 1, very small standard guys, only two sides, that's it, very small standard. 128 subsection 1 of the Companies Act. All these three sections are as per Companies Act only. What is 128 subsection 1 talking about? All the companies have to keep the books of accounts, the financial statements at the registered office of that company. What is the meaning of registered office? So basically, registered office is a place where they will be keeping the books of accounts, financial statements. Every company should have a registered office. Basically, it is public information available for public. If I go and if I actually go to Google and I want to find out the registered office of Reliance India, I can just directly put registered office of Reliance Industries Limited. Where is it? Nariman Point, Mumbai. Public information. Open to all. Registered office of any other company. Tata Steel, Homi Modi Street, Fort, Mumbai, Maharashtra. Like that, any company you want, you can find the registered office, and that is the reason why all the companies have to keep the books of accounts, the financial statements at their registered office. They can keep it in electronic mode also. Now, if there is a company which is having branch office, where should they keep? All companies, including the branches, they have to keep the books of accounts and financial statements at the registered office. In case if they are going to keep it in any other place, then a notice in writing has to be kept at the registered office giving the full address of that other place. So basically, if I am an individual, if I want to access the books of accounts financial statements, I should be going to the registered office and I should be able to find out all the details with respect to the books of accounts financial statements. In case if it is not there in the registered office, at least the full address as to where it is available should be given. In case if it is given in any other place, a notice in writing has to be kept giving the full address of the other place. Is that clear? This is section 128 subsection 1, guys. Now I'm going to second section, that is 128 subsection 2. This is basically for all the branches where they are deemed to comply with 128 subsection 1 if the branch office is keeping the books of accounts in their branch office itself. However, something has to be kept at the registered office. The summarized returns periodically have to be kept at the registered office or any other place if the address is kept in the full address is kept in the registered office. Now this branch office is including all the offices in India and also outside India. Is that clear? For all the branches, they are deemed to be complied with 128 subsection 1 if the branch office which is situated either in India or outside India are keeping the branch of books of accounts in the branch office itself. However, the summarized returns periodically is sent to the registered office, or if it is given at any other place, the full address of that other place has to be maintained with the registered office of the company. Is that clear? The next standard, guys, is 143 subsection 8. This 143 subsection 8 is talking about the duties and powers of the company's auditor with respect to branch auditor. What was the first section we saw? 128 subsection 1, where all the companies, including branches, they have to keep the books of accounts financial statements at the registered office of the company. Then we went to 128 subsection 2. We spoke about all the branches in which is in India or outside India have to keep the books of accounts in the branch office itself, but the summarized returns periodically have to be given to the registered office of the company. 143 subsection 8 is talking about what is the duty of the company auditor with respect to the branch auditor. Now for this you need to understand, if there is a branch office, who can be appointed as the auditor for this branch office? The company auditor itself can be appointed as the auditor of the branch office, or any other person specifically can be appointed for this branch office. That means any other person as per section 139 can be appointed as the auditor of this branch office. Or if this branch office is outside India, then the auditor of that country, that is a CPA or any other person as per that country, can be appointed if it is outside India as the auditor for this branch office. However, whoever has been appointed, the branch auditor, that is whether it is the same person as company auditor or any person specifically under section 139 of the Companies Act, or a CPA or any other person outside India, whoever is capable of doing the audit of the branch office, this branch auditor will prepare the report and he will send it to the company auditor. That is only the duties and powers of company auditor with respect to the branch auditor. That is 143 subsection 8. Is that clear with all the three sections? 128 subsection 1. Every company shall prepare and keep at its registered office the books of accounts and other relevant books and papers and financial statements for every financial year, which gives a true and fair view of the state of affairs of the company, including that of its branch office or officers. Such books shall be kept on accrual basis and according to double entry system. All or any of the books of accounts can be kept in such other place, but that other place has to be in India. The company will file with the registrar a notice in writing giving the full address of that other place. It can also be kept in electronic mode. 128 subsection 2 is talking about where a company has a branch office either in India or outside India. It will be deemed to have complied with the provisions of 128 subsection 1 if the books of accounts of the branch office are kept at that office and summarized returns are periodically sent by the branch office to the company and its registered office as referred to in subsection 1. 143 subsection 8 is talking about duties and powers of the company's auditor with respect to the audit of the branch or branch auditor. Where the company has a branch office, the accounts of that office will be audited either by the auditor appointed by the company or by any other person as appointed by 139 of the Companies Act. If the branch auditor is situated outside India, then the accounts of the branch auditor will be audited by the company's auditor or by any person duly qualified in accordance with the laws of that country. The branch auditor will prepare a report on the accounts of the branch which is examined by him and send it to the auditor of the company, who shall deal with it in his report in such a manner as he considers necessary. That is 143 subsection 8. Coming to the three definitions of principal auditor, other auditor and component. First, you need to understand what is the meaning of component. You're calling a branch, a division, a joint venture, associated enterprise. All these are called as components, where the financial information of that component is included in the financial information audited by the PA, that is the principal auditor. Now read what is a principal auditor. Principal auditor is the auditor who is having the utmost responsibility for reporting on the financial information if that financial information includes the financial information of one or more components which is audited by other auditor. Who is this other auditor? It means he is the auditor other than the principal auditor with the responsibility of reporting on the financial information of a component which is included in the financial information audited by the principal auditor. Is that clear? Basically, say for example, we will take the example Sri Krishna Sweets. Sri Krishna Sweets has 47 branches. Now, each of the branches will have an auditor. That person is called as other auditor. Overall, Sri Krishna Sweets, this auditor is called as principal auditor. Each of the branches, the auditor is called as other auditor. Each of the branches is called as component. So, for each component, the auditor is called as other auditor. Very, very clear with definition and 3 section numbers. What is the procedures by the principal auditor? Basically, the principal auditor should help the other auditor. Yes or no? The principal auditor will be advising during the planning stage itself. See here, this is what I'm expecting out of you. So please keep this in mind that your work is used by me at the end of the day. Like this, the other auditor will get the insights from the principal auditor. The principal auditor can also give the timetable for the completion of the audit itself. Now see here, the principal auditor will perform procedures, that is principal auditor is doing the audit procedures to obtain SAI that the work of the other auditor is adequate for the principal auditor's purpose. How is he going to see that it is adequate? Principal auditor will normally perform the following procedures whenever he is using the work of other auditor. The first one, he has to advise the other auditor of the use that is to be made of the other auditor's work and report and make sufficient arrangement for coordination at the planning stage itself. Principal auditor will inform the other auditor of matters such as requiring special considerations, procedure for identifying intercomponent transactions that may require disclosure, and he will also give the timetable for the completion of audit. Now, how to remember these 3 points with the keywords I'm going to tell you. If they ask procedure by principal auditor, there are 2 points, but inside the first point itself, there are 3 points because the first one is talking about the principal auditor will advise the other auditor what is the use that is to be made of the other auditor's work. Use of other auditor's work will be given to the other auditor prior itself. If there are any special considerations, that is intercomponent transactions, say for example, if Sri Krishna Sweets is having 47 different branches, if Mysore Pak is required from this branch to this branch sale completed. So from one branch to another branch, I'm just shifting the Mysore Pak. For this branch, it might be shown as a sale, whereas it is not a sale because it is a intercomponent transaction. When this other auditor is doing his work, he will think that it is a sale, but only the principal auditor who is having the bird's eye view will have an understanding that this is not a sale and it is only an intercomponent transaction. Are you able to understand? So basically, the principal auditor should be talking about any intercomponent transactions which is there, and if there are any special consideration which has to be communicated to the other auditor, that also must be told to the other auditor. Apart from this, the principal auditor can also give a timetable to the other auditor saying, boss, this is where I'm going to use your work. By this time, you have to finish this and give it to me. Only then in the next 2 months, I will be able to do my work. Like that, you give the timetable for the completion of the audit itself. So these 3 points combined together becomes the first point. What is the second point? They are going to have a reporting. So what reporting requirements is there? You please tell prior itself, sir. Accounting, auditing and other reporting requirements to obtain representation to comply with them. So that advice also will be given to the other auditor by the principal auditor. I hope you remember the other auditor is the auditor of the component. That means the auditor of the branch. The principal auditor is the overall auditor. The group's auditor is called the principal auditor. So here, what are the procedures which has to be done by the principal auditor? The principal auditor will perform procedures to obtain sufficient appropriate audit evidence that the work of the other auditor is going to be adequate. For that, 3 things that he's going to do as part of the first point. He will advise the other auditor for what work he's going to use the other auditor, and he will see for special considerations, and if there are any intercomponent transactions, he will also advise the other auditor as to how to identify the intercomponent transaction. I hope now you understood as to what is the meaning of intercomponent transaction. Then the principal auditor will also give the timetable for the completion of the audit. Second point, he will advise the other auditor about the significant accounting, auditing and other reporting requirements. This is the report, and he will see for complaints with them. These two are the procedures which is done by principal auditor, guys. That's it, guys. That's it. SA 600. Only 3 things. That is 3 definitions we saw, 3 section numbers we saw, and procedure by principal auditor. Only 2 points. And with that, SA 600 itself comes to an end. Yes, guys, let's start off with SA 610. 610 is using the work of internal auditors. Now, few of you will have a confusion as to which one is 600 and which one is 610. 600 talks about other auditor, using the work of an other auditor. 610 talks about using the work of internal auditor. Like this, you can remember OS 600, that is, they talk about another auditor who's gonna be there, and 610 is gonna talk about the internal auditor. So I hope you will not forget the name and number and no more confusions with regard to which is 600 and which is 610. 610 is using the work of internal auditor. Is that clear? Now, I'm going to get into the standard without wasting much time. But before that, as usual, let us first understand as to what we can expect from the standard. We're going to start off with meaning of internal audit. Then we go to ways in which the external auditor may make use of the function. So here, the function means the internal audit function. So in multiple places, you will just see the function or IA function, both mean the same. That means it is the internal audit function. So ways in which the external auditor will make use of the internal auditor. If external auditor is making use of the internal auditor, what is the EA's responsibility who is using the work of audit? Next comes the objectives. Next is using the work of internal auditor. How am I going to evaluate the internal audit function? What are the circumstances in which internal audit function cannot be used? What is the example of the IA function which is used by the external auditor? Circumstances where the external auditor uses less work of the internal auditor. External auditor plans to use the work of internal auditor in these cases. Next, there is a separate concept called direct assistance. Under that, we're going to see what is the meaning of direct assistance. How are you going to evaluate the internal audit function? External auditor shall not use internal auditor to provide direct assistance in these scenarios. And prior to using the internal auditor for direct assistance, what should the external auditor do? If you understand all of this, so now itself when you see the mind mapping, you know, okay, internal auditor can be used for 2 things. One, here I'm using the work of internal auditor, and here I'm using him for something called as direct assistance. You get a broad overview when you see the mind mapping itself. Now I'm getting into meaning of internal audit. The internal audit function refers to the function of an entity. I told you here in 610 you will keep seeing IA function. That is why I have written IAF in the mind mapping also. The internal audit function refers to the function of an entity that performs assurance and consulting activities. Is the internal auditor going to do audit? No. The meaning clearly says that it is a function of an entity in itself that is going to perform two activities, assurance activity or some kind of consultancy activities, which is designed to evaluate and improve effectiveness of three things. What are the three things that they are going to talk about? Entities governance is the first part. Entities governance, risk management, and internal control process. These three things is what the internal auditor is gonna take care of. What are the three things? Entities governance, risk management, and internal control process. Is internal audit a procedure to conduct the audit of the entity? No, it is a assurance activity. It is a consulting activity. Is it a separate, like how an external auditor should be independent? Should the internal auditor also should be independent? No, it is a function of an entity in itself. It is a function of an entity that performs these two activities, basically to do three things, that is governance, risk management, and internal control process. What is governance? Governance is basically seeing the objectives, values of the organization. You would have studied in strategic management. What is vision, mission, objectives, and all of those things. Whether the people who are part of the organization are having the same values, same ethics, and whether they are able to perform a certain way. Is the accountability proper? All of those things. Is the communication proper between all the levels of employees? That is activities relating to governance. What is activities relating to risk management? Risk management is a sector which is actually increasing. So much people are practicing after becoming CA in this risk advisory place. Risk advisory is basically what? Risk management is basically what? Every business is risky. Yes or no? What is that exposure to risk? What is the tolerance of the risk? How can I manage the risk? Are they having internal controls properly? Is it operating effectively? Is it reducing the risk? All of those things are activities relating to risk management. I keep telling an example for internal control. That is, in a theater, say this theater is PVR, and a boyfriend and girlfriend, they want to enter the theater with a single ticket. Is it possible? Yes, it is possible, because in the theater, there will be one person who's standing outside of the theater. He is going to ask for the ticket. Now the girl, she goes inside, and obviously corner seat only, she is going to sit there. Yes. Now, when the boy comes, say 10 minutes late, after the movie has started, after 10 minutes he is coming, he is rushing into the theater like anything. It is an empty theater, obviously. Corner seat means empty theater only, they'll book the corner seat. Yes or no? Yes. So now what the boy is doing, after 10 minutes, he is going to enter the theater in the same route only. Now this guy, he is going to see the phone. Whether you really show the ticket, or whether you're showing your Swiggy order, whether you're showing some message, whether you're showing some photo, he doesn't know. There is no scanning or anything which is happening there. He will just see, okay, keep going inside. That's it. There is nobody to actually check. That means what? That means the internal control is weak. Now, what is the risk for PVR? What is the risk for PVR? Revenue leakage is definitely a risk for PVR. Now, if I have a proper internal control system, saying this person is going to scan, and once scanned, if you scan the second time, it will have a beep sound. It will not allow you inside. If you scan the first time, it will say tick, green color tick will come. Then this person will know, okay, I can allow them inside. If I bring in a system like that, just one scanner and a device, that's it. If I bring this system, can I minimize my risk? Can I minimize my risk? Yes. So the risk management is directly linked with the internal control. That is what I wanted to prove to you. The internal audit function may assist by identifying and evaluating the exposures to risk and contributing to the improvement of risk management and internal control. You reduce the risk, that is, you manage the risk, and you also take care of the internal control process. The IA function may perform procedures to assist the entity in detection of fraud. Yes, there was fraud which is happening. Yes, planned fraud this boyfriend did, yes or no? So to detect the fraud also, activities relating to risk management can help you because it is directly linked with internal control. Now this activities relating to risk management is done by whom? By the internal audit function. Is that clear? The first one was activities relating to governance, activities relating to risk management, and third is activities relating to internal control. This person will help to evaluate the internal control, examination of financial and operating information. He will review the operating activities and he will also review the compliance with laws and regulations. Now, if you see here, we started off with meaning of internal audit. What is the meaning? It is a function of the entity that performs two activities, assurance activity and consulting activities, for improving the effectiveness of entities governance, risk management and internal control process. What did we see under entities governance? The accountability, communicating the risk, ethics, values, objectives, whether all of that is prim and proper, the internal auditor is going to see. Activities relating to risk management, yes, he is going to improve the risk management and also see the internal control and see if he is able to detect any fraud. And third, activities relating to internal control. Here we saw evaluation of internal control, examination of operating activities, review of operating activities, and review of laws and regulations also. Is that clear? This is only a extrapolation of the meaning. That is the reason why, if you see here in SA 610 in the mind mapping, we started off with meaning of internal audit, and under that, activities relating to governance, activities relating to risk management, activities relating to internal control. Very, very clear. Now I'm moving ahead to the second Roman number, ways in which the external auditor may make use of the internal audit function for the purpose of audit. Where can I make use of the internal audit function for the purpose of audit? The first one, to obtain information. Now, what is the external auditor going to do? The external auditor is going to do the audit procedures to get information. This information is the evidence, audit evidence. So the auditor can make use of the internal auditor to obtain some kind of an information that is relevant for the assessment of risk of material misstatement, whether due to fraud or error. Unless prohibited or restricted by law or regulation, the EA, of course, after appropriate evaluation, will decide to use the work that has been performed by the IA function during the period in partial substitution for audit evidence to be obtained directly by the external auditor. Unless prohibited or restricted to some extent, the external auditor may use internal auditor to perform audit procedures under the direction, supervision and review of external auditor, referred to as direct assistance. I am sure if you just read the text like this, you will not understand. Just listen to me explaining the concept. Now, the first part is talking about there are two people here, yes, external auditor and internal auditor. How am I going to use the work of internal auditor? This internal auditor does three things. You already know that: governance, risk management and internal control. Now, this internal auditor has already done the work and the IA report is already there, which is done by the internal auditor. Now, this external auditor, all he is going to do is use this internal audit report. Now, everything is done by the internal auditor. The external auditor is just using the IA report. Now, see the second circumstance. The second circumstance is talking about there are two people again, external auditor and internal auditor. Now, the external auditor is telling the internal auditor, hey, I need these evidences for which I want you to look at the internal control in these areas. Can you please look at that? Now the internal auditor is going to do the work exactly which is given by external auditor, and then he is going to give a report. Are you able to understand? In the first one, IA functioned by himself and he prepared the report. The EA is just using the report for evidence. In the second one, the EA is asking the IA to do some work and then give the report. Now you read the text, you are going to understand fully. See the second one, unless prohibited or restricted by law or regulation, the external auditor may decide to use the work that has been performed by the IA function. Sorry, what happened? Yes. External auditor may decide to use the work that has been performed by the internal auditor. Already work has been performed here. Is that clear? during the period in partial substitution for audit evidence to be obtained directly by the external auditor. Now see the third one, the external auditor may use internal auditor to perform audit procedures under the direction, supervision and review of external auditor. So here what is happening in the second scenario, the external auditor is asking the internal auditor to do audit procedures. Now he is becoming like an assistant for the statutory auditor and then he is giving a report to the external auditor. This is called as direct assistance. Are you able to understand? It's okay. Read the text again. I hope you understood this concept. Here the internal auditor is functioning by himself and he is doing the internal audit report and external auditor is just using that report. Here the external auditor is asking the internal auditor, I want these audit procedures to be done. Can you please help me do that? Like that he is asking the internal auditor and then the internal auditor is doing that job and giving the report. That is the difference between these two. Now read these 2 points. Unless prohibited, leave all of these things. The external auditor may decide to use the work that has been performed by the IA function during the period in partial substitution for audit evidence to be obtained directly by the external auditor. So it has already been performed by the IA function. Now the third one, the external auditor may use the internal auditor to perform audit procedures under direction, supervision and review of the external auditor. This is only referred to as direct assistance in itself. Where did you see direct assistance? Did you see this for the first time? No, in your mind mapping, direct assistance was a separate topic. Now you have understood the meaning of direct assistance. That means what? The external auditor is asking the internal auditor to do the audit procedures itself and give him some information. Yes? Clear? Now comes to scope of SA 610. 610 deals with external auditor's responsibilities if he is going to use the work of internal auditor. It is not mandatory, it is not compulsory for the statutory auditor to always use the work of internal auditor. But if he is going to use the work of internal auditor, automatically SA 610 will come into place. So SA 610 is specifically talking about when an external auditor is using the work of internal auditor, what and all should be done, what and all should not be done, when he can work with internal auditor, when he should not be working with internal auditor. All of those things only SA 610 is talking about. The first one, using the work of internal audit function in obtaining audit evidence, using internal auditor and providing direct assistance under the direction, supervision and review of the external auditor. Now multiple times you're seeing this, that is the keyword, it is also given in red. For the first one, you're using the work which is already done by him for the audit evidence purpose. In the second one, when you're getting the direct assistance, you have to direct the internal auditor, you have to supervise the internal auditor and you have to review everything, yes, of the internal auditor. So this part is given by the external auditor to the internal auditor. This becomes the keyword in direct assistance because it is directed, supervised and reviewed by the external auditor. Is that clear? Using the internal auditor and providing direct assistance under the direction, under the supervision and under the review of the external auditor. Now you all tell me, if I'm using the work of internal auditor, in the future, the auditor has made some mistake. Can I say that I made the mistake because of some other person called as internal auditor? I used his work. I got his direct assistance. He made the mistake, stupid fellow. Now don't put me in jail. I put the signature. Yes, I am not denying that. But I relied on his work. You please put him in jail first. Like that, can the statutory auditor argue? No. Who put the signature, they have the sole responsibility for the audit itself. The external auditor, read the next sentence. The external auditor has the sole responsibility for the audit opinion expressed, and that responsibility will not be reduced just because you are using the work of IA function, or even if you use for direct assistance, that responsibility is not going to reduce. Who has the sole responsibility? The external auditor, the statutory auditor. Both are one and the same. Yes, he has the sole responsibility because he is the person who's signing and he is the person who's expressing his opinion on the financial statements. Yes, so he only will have the sole responsibility at all times, whether he is using the work of internal audit for audit evidence or he is providing, or whether the internal auditor is providing a direct assistance. Doesn't matter. The sole responsibility is always with the external auditor only. Objectives. To modify the nature or timing or reducing the extent or to use the internal auditor for direct assistance, the objectives are to determine whether the work of internal auditor can be used or whether direct assistance can be taken. If so, in what area can you use and to what extent you can use. If you are using the work of internal auditor, whatever work that person has done, is it adequate? That is audit evidence, but is it sufficient and appropriate audit evidence? That is only talking about the adequacy. What about the quantity and the quality of the audit evidence? That you have to see. SAI has to be checked. Yes, if using the direct assistance to appropriately direct, supervise and review their work. Ultimately, it is the sole responsibility of the external auditor. So the objective is saying to determine whether you can use the work of the internal auditor, in what area are you going to use it and to what extent are you going to use it. If you are going to use, whether that work that is done by the internal auditor is audit evidence, but is it adequate audit evidence? Does it comprise a sufficient and appropriate audit evidence? If you're going to use direct assistance, whether the external auditor is able to properly direct, properly supervise, properly review their work, that also we will have to see. Using the work of internal auditor. How to evaluate internal audit function. Now till here we are done. Ways in which EA can make use of IA function. EA's responsibility using the work of audit. What are the objectives? Now for using the work of internal auditor, how am I going to evaluate internal audit function? Circumstances where internal audit function cannot be used. Any example where the internal audit function can be used by external auditor. Circumstances where you can use less of the work of the internal auditor. And if external auditor plans to use the work of internal auditor, what should he do? How to evaluate the internal audit function. The external auditor has to evaluate the internal auditor with respect to three things. What are the three things? Objectivity, level of competence, systematic and disciplined approach. What is the meaning of objectivity? Objectivity means you perform a certain way without allowing any bias, without any conflict of interest, without any undue influence to override professional judgments. Nowadays, with technology and everything, it is so easy to influence people. That is the reason why there are so many influencers who are coming up. Even if you don't study, even if you don't have a degree, you can become an influencer. Is there any qualification for an influencer? And you will not believe how much they'll be earning in lakhs. And I know few influencers who are even earning in crores. People who are in the finance field and people who are doing this get ready with me content, they are all earning very well and just eating, putting the review, earning very, very well. Just reviewing the sneakers. I think there was one person called Sneakerhead or something like that. He will just review the sneakers. Sneakers mean shoes. He'll review the shoes and get paid for that. Earning in lakhs. So it is very easy to influence. But here, when you evaluate an internal audit function, you should see whether they are not allowing any bias, whether there is any conflict of interest, whether there is any undue influence, so that the professional judgment gets overridden. You also have to see the level of competence. Now, what level of competence, ma'am? Is there any qualification for an internal auditor? You guys please tell me. What is a qualification that an internal auditor should have? I hope this subject is super interesting because you all will be doing internal audit. Or you all will be an external auditor where you will be thinking whether you can use the work of internal auditor. Or you will be an external auditor, your friend will be an internal auditor, you can work together. All of these scenarios can happen. I want you to think that way. When you are studying itself, you should have that broad mindset. I am going to work this only. Essay 610, I am going to use. Now you can create scenarios in your head. And that scenario only ICA is also creating. So on a case study based scenario questions only they are asking. So when you're studying itself, try creating those scenarios. Now you are an external auditor. You have to evaluate internal audit function. What are the three things you have to evaluate? You have to see the objectivity, you have to see his competence, you have to see the systematic and disciplined approach. Like this, if you study, you will never forget the points. Now coming back to my question, what is this competence that we are talking about? Is there any qualification for an internal auditor? Is it that only a chartered accountant can be an internal auditor? No, not only a chartered accountant. Then who else can be? Can a BCom graduate be an internal auditor? Yes, BCom graduate can be an internal auditor. Can an engineer be an internal auditor? Yes, engineer can be an internal auditor. Can a past employee be an internal auditor? Yes, a past employee can be an internal auditor. Is independence required to be an independent auditor? No, independence is not required for an internal auditor. Okay, 12th pass. Can the 12th pass person be appointed as the internal auditor? Yes? No? Confused? ஒன்னு இப்படி ஆட்டு இல்லை இப்படி ஆட்டு ஏதோ ஒன்று ஆட்டு either you say like this or you say like that. Simply don't keep on staring. Can a 12th pass be appointed as the internal auditor? Yes, no, maybe, confused. Say something. Confused. Till now, did we see that an internal auditor should be a chartered accountant, internal auditor should be engineer, internal auditor should have a qualification, internal auditor should have 2 qualifications, single qualification, undergraduation is enough, postgraduate, something did we see like that? That means any person who has the required knowledge, required skill, he can be appointed as the internal auditor. Please read this. Competence here refers to attainment and maintenance of knowledge and skill of the internal audit function as a whole. If you have that adequate knowledge, 12th pass illa, even if you are 12th fail, you can be appointed. But here, level of competence is talking about you have to have the adequate knowledge and the skill for this internal audit function. If you have that knowledge and skill, we are not going to look at the qualification and all of those things. Systematic and disciplined approach. The application of a systematic and disciplined approach to planning, performing, supervising, reviewing, and documenting its activities, distinguishing the internal audit function from other monitoring activities which is performed by the entity. The entity itself will be performing monitoring activities, that is different, and what internal audit function is doing is different. So how are we going to evaluate the internal audit function? By 3 ways: objectivity, level of competence, systematic and disciplined approach. Circumstances when work of internal audit function should not be used. Now you went for audit, you are the external auditor, now you saw these scenarios. If these scenarios are there, you should not use the work of the internal auditor. What is that circumstance? See here, we saw that if objectivity is there, if competence is there, if systematic and disciplined approach is there, you can use the internal auditor. The place where you should not be using the internal auditor is if competence is not there, if systematic and disciplined approach is not there, if the objectivity is not there. The ulta of those 3, if you write, you are going to get the full marks. That only is there in ICA material also. See here in the concept book, the functions, organizational status, and policies and procedures do not adequately support the objectivity of the internal auditor. The function lacks the competence. The function does not apply a systematic and disciplined approach, including quality control. Now, if these 3 are not there, then the work of internal audit function cannot be used. Is that clear? Very, very clear, super clear. Can I move forward? Yes. Only if everybody is clear, I'm going to move forward. Simple, right? If those 3 are there, I'm going to use the work. If those 3 are not there, I will not be using the work. That's it. Example of the work of the internal audit function that can be used by the external auditor, including the following. See here, examples are given in a box. That means in ICA material also it is given in a box. That is the reason why there is a different color box which is used here. For testing the effectiveness of the internal control, I can use the internal auditor. Any substantive procedures which is not very high on judgment making, low judgment, limited judgment is there, then to do the substantive procedures, I can use the work of internal auditor. Observation of inventory count, we keep doing this physical verification of inventory. For that, I will use the internal auditor. Tracking the transactions through the information systems which is relevant to financial reporting process. Usually what will happen, nowadays we are doing auditing in the computer, correct? You will be doing audit through the computer. That is a way of audit. Audit through the computer means the computer is the one which is processing the data and giving you the final output. Can I rely on this data? Will be a question in your head, for which you will be auditing the data and you will also be auditing the process. The process is where it is inside the computer, that is tracking the transactions through the information system which is relevant for financial reporting. The fifth one is testing of compliance with regulatory requirements. For that work also we can use the work of internal auditor. Circumstances in which the EA shall plan to use less of the work of the IA function. Wherever there is so much of judgment involved, then do not use the internal audit function. If the risk of mental misstatement is very high, then it is risky area. You yourself has to be present. So in that case, you use less of internal auditor's work. The less the IA's organizational status and policies and procedures adequately support the objectivity of internal auditor. What do we talk about objectivity? If that objectivity is there, we will be using the work of internal auditor. What is objectivity? He should not have bias, he should not have conflict of interest, and he should not be unduly influenced. If these three things are not there, then we will be using the work of internal auditor. Now here they are saying the organization is not allowing the internal auditor to act objectively. That means organization itself is having some undue influence. Organization itself is giving some bias. Then in that case, use less of the IA's work. Lower the level of competence. If it is a lesser competence, then lesser work only we will be using. We will not fully rely on them. In case if the external auditor is planning to use the work of internal auditor, then what should the external auditor do? Okay, now I am convinced with these three things. Systematic and disciplined approach is there, level of competence is there, objectivity is there. Now I have decided, okay, it's fine to use the work of internal auditor. Now what should the external auditor do? He should discuss the planned use of the work with the internal auditor. There should be some coordination between these two people. He will be reading the report, whatever is prepared by the internal audit function. Now, can I just directly just take that as audit evidence, as sufficient appropriate audit evidence? No. I will not trust the data. I have trust issues. So what I'm going to do, whatever internal auditor has done, I will be performing audit procedures on the body of the work of internal audit function, so that my trust issues will get cleared on this data which is presented to me. Is that clear? So here, if the internal auditor plans to use the work of if the external auditor plans to use the work of internal auditor, he will discuss the planned use of work with the function. He will read the report of the internal audit function. He will perform audit procedures on the body of work on internal audit function as a whole that the external auditor plans to use. This discussion and coordination must be there between these two, because it is useful to address the timing of the work, nature of the work, extent of the work, what is the materiality, what are the proposed methods, how should the documentation be, reviewing and reporting procedures. Of course, the communication will help for all of these 7 points. When will the communication, when will the coordination between them be effective? It will be effective when all of this is discussed initially, and at a later stage also, weekly once or fortnightly once, they will keep discussing with each other at appropriate intervals. Now you all tell me, you all are purchasing the class in the CA classroom, correct? You all will come one day and you will purchase the class. This is your day one. How many of you all have the habit, as soon as you purchase, you will go and see what is there? Even if you go to a shop, if you purchase something, as soon as you come home, you will see, oh, all these things we have purchased, just to feel happy. We have that habit, correct? In fact, I have the habit, like if I purchase, say, a dress, I would have worn it in the trial room. I would have seen, I would have gotten approval from Karthik sir. Everyone would have said nice, very good and all. Even then, I will come back home. And as soon as I come home, I have to wear that new dress and I have to see whether it is the correct fitting, whether it is the correct color, because these showrooms, they will put very bright yellow colors. The color itself will look different, but after coming home, color will be different. Why all these things? So as soon as I come home, day one itself, you have to do the trial. Even though the trial is done in the shop, you have to see it. So like that, when as soon as you purchase the class, motivation is high and all. So day one, you have watched the lectures. Day two, what will happen? Yes, motivation is still there. Watch the lectures. Day 30, what will happen? Motivation has dropped. Distractions has increased. Now, once you know to manage these two things, distraction, motivation, you need to manage both the things. See, when you keep on get activated by motivation, that is also wrong. Then what is only right, ma'am? The right way is discipline. The right way is routine. Once you have this discipline to have your own routine, then no one can touch it. But when you're only working on motivation, you saw some video. Oh, video is so motivating. From tomorrow, I will start studying. 2 days you'll study. Third day you'll not study. But usually students have this mindset, yes or no, that motivation must be there at different points in time. That is the reason we understood the pain points, and that is the reason we actually have weekly calls. Now, what we do in the CA classroom, day 1 you're purchasing the class, day 7 you get on a weekly call with me, with Karthik sir. Understand how to study, why you didn't study last time. Like that you keep talking to us. Day 14, second call. Day 21, third call. Like that we will be in touch with the students, so that you also know, okay, you're not just looking at recorded lectures. There is actually some person behind this recorded lecture. You are connecting at an individual level. Even though it is a group call, everybody gets a chance to talk. Or some people, when they're shy to show their face or shy to talk, you can put in as a message. Yes or no? So some kind of a communication when it is there. Now, when you meet me on day 14, 15, 16, 17, at least you will be motivated and give your best. 18, 19, 20, it will drop. Again on 21, I will appear like a ghost. Hey, call time, come. What did you do? First 3-4 days I studied, ma'am. Last 2 days didn't study. No problem. Next, again you put a separate plan for the next 1 week and you start following that plan. Day 21, 22, 23, 24 or maybe 25 also you would have studied. 26 and 27 little lethargic. Again, I will appear on 28. Like this, in intervals, when I keep appearing, then is the time you will understand, okay, somewhere I am studying in the process. From day 1 to day 30, there is progress. You will be able to see this. Once this happens, that is the reason why we don't just sell class. Not just selling the recorded lectures and leaving you alone. We also travel with you. Discussions take place at appropriate intervals throughout the period. The external auditor informs the internal audit function of significant matters that may affect the function. The external auditor is advised of and has access to relevant reports of the internal audit function and is also informed of any significant matters. Is that clear? Till now we saw using the work of internal auditor, what and all we have to keep in mind. How to evaluate, 3 things to evaluate: objectivity, level of competence, and systematic and disciplined approach. Circumstances when IAF cannot be used, these 3 things are not there, it cannot be used. Examples we saw: internal control, physical verification of inventory, all those examples we saw. When you should use less of internal auditor, when high judgment is involved, and all of those points. When he plans to use the work of internal auditor, what he has to do. Then comes direct assistance. What is the meaning of direct assistance? I showed you this example, right? Direct assistance means the external auditor is asking the internal auditor to perform certain audit procedures. He is giving the work to the internal auditor, and then the internal auditor is doing the audit procedures and giving the report and then giving it to the external auditor. Direct assistance refers to the use of internal auditor to perform audit procedures under DRS, direction, review, and supervision of the external auditor. The external auditor may be prohibited by law or regulation from obtaining direct assistance. That's why previously also we saw, unless prohibited by law or regulation, the external auditor may use the work of internal auditor, or the external auditor may use the internal auditor to perform audit procedures under direction, supervision, and review. How to evaluate the internal audit function? How will you evaluate? By way of 3 things. What are the 3 things? Objectivity, competency, and systematic and disciplined approach. Now here, there are only 2. Because, tell me why. Systematic and disciplined approach is not there. Why? For direct assistance. Because here, under direct assistance, the external auditor only is telling the internal auditor, you have to do this work. The system is given. Yes, the discipline is given. You have to follow these points. That is the reason why I don't bother whether the internal auditor is actually doing it by himself, because I am the one who is giving him the work. By this date, you please give me the evidences that you have collected. Like that, I'm asking him to do the direct assistance to me. That is the reason why here for direct assistance, we have only 2 points, that is objectivity and competence. When the external auditor will not use internal auditor to provide direct assistance, when there is high judgments, when the risk of material misstatement is high, when it relates to the work which the internal auditor have been involved and which has already been or will be reported to the management or TCWG by the internal audit function. That means what? Say you're saying, do the physical verification of inventory. Now, this internal auditor only framed the internal controls for the inventory process. In that case, isn't the maker and checker the same? He only made the rules. Now, as part of direct assistance, he is going to audit. He is going to check the rules. When the maker and checker is same, is it right? No. It is definitely not right. That is the reason why the external auditor has to see, when he is using the internal audit function for direct assistance, whether whatever work that he is going to do, whether internal auditor was involved in that work itself. It relates to the work which the internal auditor has been involved and which has already been or will be reported to the management or TCWG by the internal audit function. The fourth point is talking about, it relates to the decisions the external auditor makes in accordance with this standard regarding the IA function and the use of the work of the IA or direct assistance. Now, for this standard, the external auditor has to think, saying whether he has competence, whether he is doing a systematic and disciplined approach, whether there is any bias, whether there is any undue influence. All of this work, who has to do? External auditor has to do. That work also don't delegate to the direct assistance team, internal audit team, don't do. Because for this standard, there is some work which the external auditor only must do. Don't try to use the direct assistance for that. That is wrong. Like that, the standard is saying the external auditor will not use the IA when it is relating to the decision of the external auditor. He is making the decision with respect to this standard regarding whether he has to use the IA worker and all of those things. That you can't use that again IA itself. That is wrong. So, if the judgment is high, if ROM is high, if the IA was involved in that work, and with respect to this standard, whatever EA has to do, EA will do it himself. For that also, don't use the IA function. Prior to using IA for direct assistance, the external auditor shall. What should he do? If he is using internal auditor for direct assistance, he has to obtain written agreement from the authorized representative of the entity that internal auditor will be allowed to follow the external auditor instructions. He basically has to get a written agreement from two people. The first agreement is from the entity in itself, authorized representative of the entity. The second agreement is from the internal auditor, because this internal auditor, I told you in the very beginning, it is part of the entity. It is a function of an entity. Now, when he is a function of an entity and when you are asking him to audit the entity itself, there might be a possibility that there is bias. There might be a possibility that there is undue influence. Yes or no? So, in that case, you get a written representation from both the people, the entity and the internal auditor. What is the entity going to say in that written representation? He is going to say that he will allow the internal auditor to work for the external auditor. I am not going to intervene in the work of the internal auditor. Like that, you have to get a written agreement from the entity. The second one, the written agreement has to be gotten from the internal auditor, because what audit will happen. All the matters which is coming from audit are confidential matters. This internal auditor must keep up the confidential matters as instructed by the external auditor. So both these things has to be written and signed. That is the reason why prior to using internal auditor for direct assistance, you please obtain the written agreement from two people, the entity and the internal auditor. Difference between IFC and IC over FR. Have you heard of this term called IFC and IC over FR? No. The term IFC refers to policies and procedures put in place by company for ensuring reliability of financial reporting, effectiveness and efficiency of operation, compliance with applicable laws and regulations, safeguarding of assets. Where did you see these 4 points? IFC refers to policies and procedures put in place by company for ensuring reliability of financial reporting, effectiveness and efficiency of operations, compliance with applicable laws and regulations, safeguarding of assets. These 4 points, where did we see already? Tell me properly. Think and tell me. Where did we see? These 4 we saw in internal control. The meaning of internal control, we saw these 4 points. Yes or no? Saying the internal control has these 4 objectives. Basically, IFC, internal financial controls, is internal control only. IC over FR, that is a completely different concept. IC over FR is where an auditor is required to give a separate opinion on the effectiveness of the entity's internal control. Based on the internal control, the auditor will be giving a separate opinion. Usually based on the financial statements is where the auditor will be giving the opinion. Yes. Now the auditor is going to give a separate opinion on the internal controls. Now this internal control is specific for internal controls over the financial reporting process. So all the controls relating to the financial reporting process will undergo a scrutiny, undergo a separate audit, and it will have a separate opinion. That is called as IC over FR report. Is that clear? Now if I give one opinion and say both I am giving the same opinion, is it okay? No. IC over FR is a separate opinion. It is an addition and it is completely different from the opinion which is given on the financial statements as a whole. Internal financial control, that is internal control, is a much wider term, whereas IC over FR is a narrower term. Why? Because internal financial control has all the controls. Yes or no? All the internal controls. IC over FR is a specific internal control where you're auditing and where you're giving a separate opinion on this IC over financial reporting. So, of course, IFC is a much broader concept than IC over FR. Is that clear, guys? In SA 610, we started off with meaning of internal audit. In that meaning, I introduced you to 3 keywords, that is governance, risk management and internal control. Then we saw ways in which the external auditor may make use of the internal audit function. What is the responsibility? What are the objectives? Then we came to how you can use them. You can use the work of internal auditor or you can use him for direct assistance. In both the cases, what are you going to see before you start using the work? In which cases you cannot use? Before you use, what should you do? In direct assistance, obtain the written agreement. From whom? From the entity and also the internal auditor. From the entity saying what? Saying I will give the full freedom to the internal auditor. From the internal auditor saying what? Saying that he is going to maintain the confidentiality. Like this, if you study entire standard, you will have an overall conceptual clarity. Usually what will happen when you are studying, it will feel like you are understanding. But at a later stage, you'll feel like you're forgetting the points. Now, when there is a mind mapping, you are mapping everything. Oh, I studied here. Oh, that is the point here. I studied something here. See, when I told you activities relating to governance, risk management, internal control, I went back to the meaning and I connected it there. In the meaning, we saw those 3 terminologies. That terminology only you're studying here. Nothing new that you're studying here. You should not feel like you're studying something new when it is part of this only. Are you able to understand? That is the reason why mind mapping is given, because it helps you to connect the points with each other when you are studying itself. Yes, guys, SA 610 is completed. Yes, guys, I'm starting off with SA 230 audit documentation. It is one of the most important standards because in ICAI, SA 230 is in a separate chapter in itself. Similarly, for SA 300, it is a separate chapter in itself. 10 marks from SA 300. From SA 230, you can expect 4 or 5 marks, guys. Attempt on attempt. That is the trend. As always, we're going to start off with a mind mapping of audit documentation. First, name and number, do not mix it up. 230 is audit documentation. Starting off with a mind mapping so that you will know what you can expect from this standard. We will be starting off with definition of what is audit documentation, objective of auditor, what is the purpose of doing this audit documentation, what it includes, what it does not include, when you should do the audit documentation, how you should do, that is the form, that is how you have to do, the content, what and all should be there, and extent, how deep you have to go into the audit documentation. The form, content, extent depends on factors such as, then comes concept of audit file, the timing of audit file, form, content and extent of timing of audit documentation depends on all of these things, and finally another concept called completion memorandum. For now, you only focus on this part, that is the definition, objective, purpose, what it includes, what it does not include, timing and form, content and extent. Starting off with the definition of audit documentation, SA 230. You all tell me what is the meaning of documentation, guys. Documentation means you are writing and keeping something for yourself. Say, for example, when I'm teaching the class, if you are taking notes on the side, that is, you are documenting whatever is happening in the class. Yes or no? As simple as that. Same way, when an auditor goes for audit, he will be documenting whatever he sees, all the audit procedures that he's doing, all the audit evidences that he's obtaining, and whatever conclusion that he's reaching, he's going to document everything. Say, for example, at a later stage in life, if someone comes and asks me, what did you do? You have told it is an unmodified opinion. You tell me how you gave this unmodified opinion. What are the areas that you tested? You give me all the data. That time the auditor can just throw the audit documentation and see, this is what I did. I have documented everything that I have did. So this is basically a proof for the auditor that he has done his duties properly. Is that clear? So audit documentation definition, it refers to a record. It is basically a record of three things: audit procedures performed, audit evidences obtained, and the conclusions that the auditor has reached. Audit procedures performed, audit evidence obtained, conclusions the auditor has reached. How should the audit documentation be? It can be pen and paper, it can be making in the notes in the computer, or it can be in any other media. You make it in CD, pen drive, floppy disk, whatever it is. It can be in paper form, electronic form, or any other media. Audit documentation is not a substitute for the accounting records. Obviously, the documentation is done by the auditor. Accounting records, how can it be a substitute? It cannot be a substitute. So that is the first one, that is the definition of audit documentation. It is a record of audit procedures performed, relevant audit evidences obtained, and the conclusions that the auditor has reached. The next is the objective of the auditor. Why is he doing this documentation? This is the record based on which the audit report is being prepared. This is the proof that I have done all my duties. So sufficient appropriate record for basis of audit report. Now, if someone comes and says, this standard asks you to do inquiry, I want to see whether you have done inquiry. Please see here, sir. On this date, I have done the inquiry with these personnel in the organization. Like this, you will be able to show I have followed whatever the standard has told me to do. So it is a evidence that audit was planned and it was performed as per the standards on auditing only. These two are the objectives of the auditor with respect to SA 230 audit documentation. Clear till here? What is the purpose of audit documentation? The audit documentation assists the engagement team to plan and perform the audit. Now, why they are saying this, I will tell you. When I was an article in KPMG, that time, what I did in my first, second client, I did not know what to do. Previous year, my senior went for the same audit. He documented everything that I asked the inquiry. I inspected these documents on this date. So I took all of those things. I read everything. I understood what I have to do. And based on that, I made my audit plan. So it basically assists the engagement team to plan and perform the audit now. It assists the members of the engagement team to direct and supervise to audit work and to tell, okay, this is work, you are responsible for this. And this audit documentation, say at a later stage, there is some problem. That time I will go and I will know, oh, this person Nivedha has done in this year. So she should be accountable for that work. So it enables the engagement team to be accountable for the work. It helps for future audits. It enables the conduct of external inspections, and it enables the quality controls of audit as per SQC1. SQC1 talks about the quality of the audit. The quality of the audit you can find out when you look at the documentation papers. So because that is going to tell you how I did my audit. So the purpose of audit documentation, basically it is to plan, perform the audit, to direct and supervise the team members. You can find out who is accountable for what work. It is useful for future audit. When external inspection comes from legal side, regulatory side, they can look at my audit documentation and be satisfied as to all the procedures that I've done. And as per SQC1 also, it is helpful when you do the documentation properly. Clear till here? That is the purpose of audit documentation. Audit documentation, what and all it includes and what and all it excludes. It includes claims. That is how you are going to read. It is not like this. It is CCLAAIMS. What is this claims? C is for checklist, correspondences. L is letters of confirmation and representation. 1A is all the analysis and the other A is audit program. IM is issues, memoranda, and last S is summary of significant matters. So what is claims? It is what the audit documentation includes. Now try to understand what they are saying. Now you know how to remember. Try to understand what they are saying. Any correspondences, that is auditor and client, will keep having emails between themselves. That itself can form part of the audit documentation. We see that when they go for audit, they will do a checklist activity. That checklist activity can form part of the documentation itself. When we spoke about this checklist and all, in SA 300 audit program, when they are doing audit program is basically like a checklist activity where the person who's doing the audit will be signing yes or no. That audit program itself will form part of the audit documentation. What is A and A? Analysis and audit program. Any analysis that the auditor is doing, that also will form part of audit documentation. IM, issues memoranda. That means any issue that I have found, I have made a compilation of all the issues that I found. That also is going to form part of my audit documentation. Any letter of confirmation, external confirmation or management representation letter, all of those letters forming part of documentation only. Any summary of important matters that I have found, that also I'm going to keep it as part of my audit documentation. So audit documentation is going to include claims. Claims stands for correspondence, checklist, letters, analysis, audit program, issues, memoranda, and summary of significant matters. That's it. This is what audit documentation includes. The next one is what audit documentation does not include. Give me a minute. Any draft of working paper, if you have, then that draft you throw it in dustbin. You keep only the final as part of the audit documentation. So superseded drafts of the working paper and financial statements will not form part of audit documentation. Any incomplete or preliminary thinking, you just thought and you wrote some, scribbled something like how my this thing will always look, how my when I write something like this. When I'm writing only, you will understand. Later, you will not understand anything. Yes or no? So how that will always look? If it is looking like that, then do not form part of your audit documentation. Any previous copies of document corrected for any error. So basically, you have superseded the document. One document is there. You have corrected it and another version has come. There was the previous version, throw it in the dustbin. So any duplicate of document. So duplicates are there means don't use those duplicates. One copy is sufficient for audit documentation. So audit documentation does not include superseded draft, Duplicate documents, previous copies, and anything which involves incomplete or preliminary thinking, it does not include. When should you do the audit documentation? That is the timing. Now you all tell me, in my regular class, I have this practice. This is how my regular class will actually be. I will give a brief and I will give an example for every standard. And after that brief is done, we will go to the concept book and go to the theory, and more examples will be shared here as and when we are reading the theory part. Before we go to the concept book, we are going to start off with mind mapping, the same way as to how we are doing in the marathon also, and then we will be doing the theory part, and then we will be finishing it. We will not stop with this. The most important one in regular class that we will be doing is the summary notes. Basically, you will be writing the entire standard in one single page, and I will be helping you to do that so that you get the full conceptual clarity of the entire standard. Now, when you do like this is when you will actually get the utmost clarity in the subject. Now, this summary note, basically after every standard, after every chapter, even for bank audit, 2 sides, that's it, finish the entire bank audit. Once you do that is when you get the conceptual clarity at the utmost level. Say for example, I'm going to tell you all 500 series. We will finish 500, 501, 505, 510, 520, 530, 560, 570, 580. Everything we will finish. At the end of 580, we will sit together and we will start the summary notes from essay 500. How you will be at that time? Looking at your faces only, I'm understanding how it will be. You're not going to remember to that extent. Yes or no? Of course, yes, you will remember the standard. You will remember what the standard is going to say. But that day summary notes, if you finish that day, then you will be having the full grip of the entire standard. Yes. So when you do the audit documentation also, that day's work on a timely basis, you will have to document for you to remember everything. The timing, the auditor will prepare audit documentation on a timely basis. Preparing sufficient appropriate audit evidence documentation on a timely basis, it helps to enhance the quality of the audit. After the audit, if you are going to prepare the documentation, that is going to be less accurate for you. Form, content, and extent of audit documentation. To which depth you have to do the documentation. Every word that the other person is saying, should you write and document it? To what level you have to document? The standard essay 230 is saying, it should enable an experienced auditor who has no previous connection with the audit to understand what you have done. Why they are talking about it enables an experienced auditor? Experienced auditor, why they are saying is because if they just say it enables an auditor, even an auditor who just cleared the examination, he is also a chartered accountant. Yes or no? If he doesn't understand, no problem. But an experienced auditor who has no connection with this audit should be able to understand the audit procedures that you have done, all the audit procedures performed, all the audit evidences obtained, and how you have reached the conclusions. And if you have made any significant judgments, he should be able to understand those judgments also. So what are they saying about the form, content, and extent of audit documentation? The auditor will prepare the audit documentation to the level where it is sufficient for an experienced auditor who has no connection with the audit, but he is able to understand all the audit procedures that I'm performing, all the audit evidences that I'm obtaining, and any conclusions that I've reached, and if there are any significant judgments that I've made, he has to understand it. When you see here, nature, extent, and timing of audit procedures performed, with respect to this, the auditor has to document these things. Who performed the audit work? Who reviewed the audit work? What is the date that work was performed? The date the work was reviewed, the extent of such review, and identify the characteristics of the items and matters which is tested. With respect to nature, extent, and timing of audit procedures performed, you have to cover these 3 points also as part of your audit documentation. Is that clear? Yes. Discussion regarding significant matters. Auditor will document discussions of significant matters with management, TCWG, and others, including nature, when the significant matters, with whom the discussion took place. Inconsistent with final conclusion, if it is there, then the auditor will document how he addressed the inconsistency also. This significant matter only was spoken here. If you have not already made the connection, significant matters arising during the audit and the conclusions reached. Now, to make it simple for you, this part, that is the nature, extent and timing of audit procedures, is given here. The significant matters, that is in the third part, that is only given here. Discussion regarding significant matters and inconsistency regarding significant matters. Is that clear? So form, content and extent of audit documentation is going to depend upon whether an experienced auditor who is having no previous connection with the audit is able to understand three things: nature, extent, timing of audit procedures performed, audit evidences that you have obtained, and any significant matters which are arising during the audit and the conclusions reached. And if you have made any professional judgments, he has to understand that also. With respect to nature, extent and timing of audit procedures performed, who performed those audit procedures, who reviewed those audit procedures, please give me the date, please give me the extent of review, and have you identified characteristics of the specific items which is being tested. You please document that part also. With respect to the significant matters, the discussion with the significant matters, with whom you did the discussion, with the management or TCWG or any other person, what is the nature of that matter which you have discussed, please document everything below. If anything is inconsistent with the final conclusion that you have reached, say for example an important matter is there, but you just neglected that and you gave a final conclusion saying unmodified opinion. Now you please tell me, how did you address the inconsistency? This important matter, how did you finalize it that this is an unmodified opinion? You please document that part also. That is with respect to the significant matters and overall form, content and extent of audit documentation. Now, this form, content and extent of audit documentation is going to depend on factors such as, that means what they're trying to say is, when you will do more audit documentation, when you will do less audit documentation. For a small company having only 4,000 rupees as the revenue, how much audit documentation will be? Maybe 10 pages of audit documentation. For a big company, 4,000 crores of revenue, how much audit documentation will be? Hundreds of pages. So the size of the entity is going to tell you the extent of the audit documentation. If it is complex, your audit documentation is going to be more. Nature of audit procedures, more audit procedures, more audit documentation you're going to do. When you finalized your risk of material misstatement, if the ROM is high, then obviously your audit documentation is going to be high. The significance of audit evidence obtained, the importance of the audit evidence that you obtained is high. That means your audit documentation is also going to be high. Nature and extent of exceptions, lot of exceptions you have found when you did the audit, so obviously you have to document everything, so your audit documentation is going to be high. The tools that you have used, you use 2 softwares, you have to document for those 2 softwares. You use 20 softwares, you have to document for all the 20 softwares. So tools, if it is going to be high, then audit documentation is going to be high. The need to document a conclusion or the basis of the conclusion, that means something is important, the need to document is high, then the audit documentation is going to be high. So for your audit documentation to be done, it depends on all of these factors: the size of the entity, the complexity of the entity, the audit procedures that you're going to do, the risk of material misstatement, the significance of the audit evidence, the exceptions that you noted down, the tools that you are using, the audit methodology that you are using, and any need to document a conclusion is high. So definitely you're going to document that. So your audit documentation is also going to be high. So the extent of audit documentation depends on factors such as, now you will come to these 7 points. If they only talk about form, content and extent of the audit documentation, you will only say a experienced audit should be able to understand these 3 things. Is that clear? The factors, if they ask, then you are going to say, if the audit procedures, the extent of audit procedure, nature of audit procedures is a factor factor which is going to determine the extent of the audit documentation that you have to do. The risk of material misstatement is a factor which is going to determine the extent of audit documentation that you have to do. Any exception that you see, if the exceptions are high, then that is going to determine the level of audit documentation that you're going to do. So it depends on all of these factors. These are the 7 factors. Going back to the mind mapping so that you have the entire conceptual clarity. We saw what audit documentation includes, excludes. Timing, we saw it has to be when the audit happens itself. Form, content, extent of audit documentation, and form, content, and extent of audit documentation depends on factors such as. We have completed the first part. I told you first you focus on this, the easy part. Yes. Now comes concepts. Audit file is a separate concept. Completion memorandum is a separate concept. What is the meaning of audit file? Audit file is basically one or more folders or other storage media. How I want you to remember the audit file, I will tell you. You know this box file, when you open it, it will open like a fan. Yes, people who have not seen the box file, I will show that to you. It's called a box file only, no guys? Yes. Yes. No, box file with folders. Yes, this one, color one. Yes, now when you open this beautifully, it will open. Yes, have you seen this in your life? I did not have that fancy one. I had this one. Yes, I had this one in my school. When you open it, it will open into multiple colors and every subject you will keep inside each of the folders. Yes. So this is called a file and this file is going to have multiple folders. So I want you to think of audit file like this file. I don't want you to think of the file as the file which is there in your computer because multiple files will become a folder in your computer. I don't want you to think that way. Here, multiple folders is going to become one file. That is the reason why I want you to think of this folder where multiple folders here will become one box file. Is that clear? Audit file may be defined as one or more folders or other storage media. It can be in physical form or electronic form containing all the records that is going to comprise the audit documentation, and every audit file is for one specific engagement. So every engagement is going to have a separate audit file and this audit file will have multiple folders inside them. Is that clear as to what is the meaning of audit file? Now, when should you complete the audit file? The auditor will assemble the audit documentation and audit file and complete all the administrative process on a timely basis after the date of audit report. The completion of the final audit file should not be more than 60 days after the date of audit report. Here they are saying timely basis after the date of audit report. What is that time after the date of audit report? Say the date of audit report in all our examples, it is 21st of June. 60 days from 21st of June. That means 21st of August. Before 21st of August, leave out the 30, 31 and all. I'm not getting into the technicalities. Before 21st of August, he has to complete the entire audit file. The time limit is what? Completion should not be more than 60 days after the date of audit report. Can you make changes to the audit documentation during the final assembly process? Changes can be made to the audit documentation, especially during the final assembly process, if and only if they are administrative in nature. What is this administrative in nature? I've given few examples. You are just deleting few superseded documentation. You are sorting, collating, cross-referencing the work papers. You are signing off, saying I have done this assembly process. For that you are signing off, specifically for file assembly process. That is something which is administrative in nature, which can be done during the final assembly process because there is a change to the audit documentation. And you are documenting the audit evidence. You have obtained the audit evidence previously itself and now you are documenting the documentation of the audit evidence that the auditor has obtained, discussed and agreed before the date of audit report. Now you are just doing the documentation process. Now that will also be considered as, that is it, administrative in nature. The changes to the audit documentation during the final assembly process can be done if and only if it is administrative in nature. For examples, for what you can consider it as administrative in nature. After completion of final audit file, can you throw that in the dustbin? No, you have to preserve it. The retention period for audit engagements is ordinarily no shorter than 7 years. That means what? Minimum 7 years from the date of audit report, or if later the date of group audit report has to be kept with you only. The audit documentation has to be kept with you. We saw the purpose of audit documentation. It is used for future audit and all. How you will use for future audit if you are not preserving it? So you have to preserve it. SA 230 is giving reference to SQC1, and SQC1 specifically has told that you will be preserving it for no shorter than 7 years. That means minimum of 7 years from the date of audit report or the date of group auditors report, whichever is later. Very, very clear till here. This is the most important part, audit file, and these three cases multiple times it has been tested in the exams previously. Audit file is basically, it is one or more folders or other storage media. It could be in physical form or electronic form, where it is containing all the records that is comprising of the audit documentation, and the audit file will be made for one specific engagement. Do not forget that. The timing of audit files should not be more than 60 days after the date of audit report. Changes to audit documentation could be done in the final assembly process if and only if it is administrative in nature. What will you call it as administrative in nature? Deleting or superseding the documentation, sorting, collating, cross-referencing work papers, signing off on completion checklist, and documenting the audit evidence. After completion of the assembly of the final audit file, you have to retain it with yourself for a minimum of 7 years from the date of audit report or the date of group audit report, whichever is later. The documentation of significant matters and related significant professional judgment. The documentation of important matters and important judgments that you make has to be documented. Few examples for significant matters. Examples of circumstances in which appropriate to prepare audit documentation with relating to professional judgment. What is this important matters? We will tell. Any matter which gives rise to significant risk, that is a result of audit procedures indicating that financial statements are materially misstated, that you have to revise the risk of material misstatement, circumstances that cause the auditor significant difficulty in applying the audit procedures. I'm not able to apply the audit procedures. Findings that could result in modification of audit opinion or inclusion of emphasis of matter paragraph. Now, all these 4 cases are gonna tell you that it is a significant matter. Is this only the 4 cases which is significant matter? No, it is only an inclusive list, but it is given in dabba. That means ICA also has given it in dabba. That means it is important. Examples of significant matters include matters that give rise to significant risk. Result of audit procedures that is going to indicate that financial statements are materially misstated. Results of audit procedures indicate that a risk of material misstatement needs a revision. Circumstances that is causing for difficulty in applying the audit procedures, and findings that is resulting in a modification to the opinion or including the emphasis of matter paragraph. All these 4 are going to tell you that it is a significant matter, and all the significant matter has to be documented. We are in SA 230 documentation. Do not forget that. The second part is talking about the circumstances in which it is appropriate to prepare the audit documentation where there is judgment. Where the matters and judgments are significant, the rationale for the auditor's conclusion when a requirement provides that auditor shall consider certain information or factors that consideration is significant in the context of particular judgment. Basis for auditor's conclusion that reasonableness of areas of subjective judgment, for example, significant accounting estimates, yes, there is judgment involved. Conclusion about authenticity of document, yes, judgment involved. Further investigation is undertaken in response to condition identified during the audit that caused the auditor to believe that document may not be authentic. These 3 are just examples where professional judgment is involved and where documentation has to be done. So this is what documentation of significant matter and related professional judgment. Going back to the mind mapping, we saw what is audit file timing, And here, what did we see? Significant matters or judgment where audit documentation is required. And finally, we have to see completion memorandum. Completion memorandum or audit documentation summary. The auditor may consider it helpful to prepare and retain as part of audit documentation a summary. That means the documentation will be for thousands of pages. Now, I am going to summarize these thousands of pages, maybe make it into a 100-page short book. This is called as the completion memorandum. This is going to have all the important matters which is identified during the audit and how they are addressed. These two are the important points. All the significant matters identified during the audit and how they are addressed. Why is this summary important? This summary will facilitate effective and efficient review and inspection of the audit documentation, especially if it is a huge audit or complex audit, where it may also help the auditor to consider whether there is an individual relevant standard objective that the auditor cannot achieve that would prevent the auditor from achieving the overall objectives of the auditor. So when you do the summary is when you will understand whether you have done all the work properly. So 1,000 of pages if it is there, make that into 100 pages. Make that as a summary. Now if you see, approximately 300 pages is a concept book. What do we do in the summary notes? We make it to less than 50 pages. We make a summary notes in our regular class. Why are we doing that? For you to have the overall understanding of the audit subject. Same way, when you go for audit also, you will be conducting the audit, you will be documenting everything that you see as part of the audit, but you will be making a summary, and that summary is called as completion memorandum. Who is the owner of audit documentation? SA 230 is giving a reference to SQC1, where SQC1 says that audit documentation is the property of the auditor. He may at his discretion make portions of or extracts available to the clients, provided such a disclosure does not undermine validity of the work performed or the independence of the auditor or his personnel. So when they talk about owner of audit documentation, SQC1 is saying that it is the property of auditor. So SA 230 is giving reference to SQC1 in two places. One is owner of audit documentation and the other one, think and tell me. For the retention period, after completion of assembly or final audit file, you have to retention period is for minimum 7 years from the date of audit report or group audit report, whichever is later. That is given where? In SQC1. So SA 230 is giving the reference to SQC1. Is that clear, guys? That is SA 230 audit documentation. Like I said, one of the important standards, 4 marks. We started off with definition. We finished and went off to objective of auditor. Purpose of audit documentation. Audit documentation includes and excludes. When should you do the audit documentation? Form, content and extent. It has to enable a experienced auditor who has no previous connection with the audit to understand the nature, extent, timing of audit procedures performed, audit evidences obtained and the conclusions that the auditor reached and the significant matters. Then we saw what is the nature, extent, timing of audit procedures performed and what is that significant matters. Then we saw the factors which is going to influence the form, content and extent, those 7 points. Then we went to audit file. In audit file, we saw one or more folders. For that, I gave you a reference example also. Then audit file timing, then significant matters or judgments. How will you document that? Few examples in both significant matters and significant judgment. And finally, we went to completion memorandum and who is the owner of all of this audit documentation. Reference to SQC1 was given. Is that clear, guys? Very, very clear with SA 230. And with that, the SA 230 has come to an end. Shall we start SA 320, guys? Yes, SA 320 is materiality. What is the meaning of materiality? Only if you know what is the meaning of this word here, will you understand the entire standard. Can you tell me the meaning of this word called materiality or materiality? Some dress material or something? No, that you are clear. Very good. So what is materiality? Materiality means important. That something is important. Now, when you go for audit, you can find a mistake, but whether that mistake is important, you will have to see. Mistake is misstatement. You would have heard this term called material misstatement. Material misstatement means important mistake. Very, very good. I'm glad that we are all on the same page. Now, before we enter the standard, we are going to see few terminologies here also when we get into the mind mapping itself. Don't get scared by looking at, oh, 14 Roman numbers are there. If you go inside first Roman number, only one small para. Second Roman number, small para. Third Roman number, this much only. So, if you see like that, it's actually a small standard, small put together, there are 14 Roman numbers. That's the reason why mind mapping looks big. That doesn't mean standard is big. Is that clear? Yes. Here you're going to study about what is this SA 320. As an auditor, what is your responsibility with respect to this standard? Has the financial reporting framework given what is materiality? Now, when you say something that is material, is only size going to determine that something is important? When I say size, here when I say size, it means like for a 5 lakh revenue making company, what will be important? Any mistake more than what number will become important for a 5 lakh monthly sales making company? An amount may be more than 20,000, yes, it becomes important because sales itself is only 5 lakhs. From that, expenses will come and then only you'll get your net profit. So 20,000 itself will become important. Now, judgment about size of misstatements considered material. Should we consider the size? Has the law told above this it becomes important? Yes, law also has said. So we will be seeing the statutory requirement. See, when I asked you that question, 5 lakhs sales making company per month, what is material? You said 20,000. This person said 15,000. This person said 10,000. That means you all are professionals and you're using your brain to give me a number. That is your professional judgment. Determination of materiality, is it a professional judgment? Next comes the concept of performance materiality. Next comes the concept of benchmark. Now, under benchmark, now don't worry, I will explain to you what is performance materiality, what is benchmark and all. Just understand these terminologies are there. Under benchmark, we will be seeing what are the factors which is affecting when you identify a benchmark, what is data for benchmark, and percentage when it is applied to the benchmark. Again, is it a matter of judgment again? Now, materiality will you have to do for account balance, class of transaction, disclosure, or should you do it for financial statement as a whole? And is there any documentation which is involved for materiality? And finally, we'll be seeing materiality and audit risk. That's it. Now, first we'll finish this part. What is materiality? What is SA 320? What is the auditor's responsibility? Statutory requirement as per financial reporting framework, whether it is only a size, and what is this professional judgment? What is SA 320? Materiality in planning and performing an audit. Wait here. What I want you to notice here is materiality happens when you are planning the audit and also when you are performing the audit. You will be seeing what is important when you are planning for the audit itself. And of course, when you're performing the audit, you're going to see what is important. So, materiality in planning and performing an audit states that misstatement, including the omissions, are material. Now, pause here again. Misstatements, including omissions, become important. What is the difference between misstatement and omission? Misstatement is basically a mistake. Now, there will be a lot of people who are saying, I will not lie to my parents. I will hide the truth. That means what? What are you actually saying there? You will not lie to your parents. That means you're not making a mistake. You're convincing yourself that you're not making a mistake, but you are hiding the truth. You are omitting something which is important to be told, but you are not telling that. Yes or no? So here they are saying materiality in planning the audit and performing the audit states that misstatements includes omission. Misstatements are not only the mistakes but also the things that you do not say or do not show, that is the omission. They become important if they individually or in aggregate can be expected to influence the economic decisions of the users taken basis of the financial statements. Individual transaction or put together, they become important when that particular transaction is going to influence the stakeholders. It is going to influence the economic decisions of the users taken on the basis of financial statements. Simple. It is going to influence the stakeholders, the shareholders or the lenders or the government, whatever it is. It is going to influence the decision of stakeholders. If it is going to influence the decision of stakeholders, any mistake or omission becomes automatically important, becomes automatically material. That is the meaning till here. Yes? I hope all of you understood till here. This is the base of materiality, SA 320. The next one they are saying materiality is not always a matter of relative size. Now when I asked you 5 lakh sales making company, you guys said 10,000 or 15,000 or 20,000 is the materiality level. Say we fix 20,000 as the materiality level. Now you tell me they have a petty cash. The petty cash, they have an amount of say 30,000 rupees. The peon, the clerk is coming to the petty cash. He is able to open the petty cash and he is able to take say 200 rupees. Is this mistake important? Now, as an auditor, when you look at this, it tells you that this petty cash is open for anybody. Yes or no? This petty cash worth 30,000 is open for anybody to take. If a peon can take, then his friend can also take. Then his family members can also take. Then another employee can take. Then that employee's friend can take. So it keeps on going. So what becomes important here is not the 200 rupees, because here the petty cash is left openly. Even a small amount, if it is lost by fraudulent practices of certain employees, which is going to indicate a serious flaw in the internal control system, when anybody can take from the petty cash. That is what it is saying. When the security guard can come and take that 200 rupees, that means the internal control system is completely flawed here. And it requires immediate attention to avoid greater losses in the future. In that case, that means what? It becomes automatically material. That time you will not be saying, hey, he took only 200 rupees. No, what you told, 20,000 rupees malada, it is material. More than 20,000 rupees, it is material. This guy just took 200 rupees. Leave him. Like that, we cannot leave. Even after setting the materiality level, materiality is not only a matter of relative size. If the internal control system is seriously flawed, and because of some transaction, even if it is below the materiality level that you fixed previously, if something says that the internal control is seriously flawed, that means today's 200 could be tomorrow's 20,000. Today's 200 could be tomorrow's 2 lakhs also. Then in that case, materiality will be fixed at a much lower size also. So materiality is not a matter of relative size. Now I have broken what I asked you earlier. Earlier I said 5 lakh rupees sales company means when you said 20,000 rupees, I clapped for you. I said yes, it is correct. But now I'm breaking that in the second sentence, that materiality is not always a matter of relative size. Is that clear? Very, very clear. Yes. Now I'm going to auditor's responsibility. As an auditor, what should I look at? The concept of materiality by the auditor, at what stages it is done? At the planning stage and also while performing the audit, and in evaluating the effect of identified misstatement of the audit and of uncorrected misstatements, if any, on the financial statements, and in forming an opinion in the auditor's report. Now I am going to explain this sentence. The concept of materiality is applied by the auditor at planning stage, performing stage, you already know. And when he found a mistake, and whether he has to leave this mistake or he has to make this mistake a big issue. Say for example, all the second child in the family will do this. Usually Anna or Akka, that is your elder brother or elder sister, when they are there at home, we like to tell about them to parents. Yes or no? Whatever mistake they do, even if they don't do any mistake, we will go and tell the parents. Simply we will say, hey, he's hitting me. Like that we'll tell. Yes or no? So, you tell me, if you find your elder brother talking on phone to his girlfriend, then will you tell your mother? Yes, it is a mistake that he is doing. So you are thinking whether you should tell your mother or not. Next day, you saw your elder brother talking to another girl, and that girl also his girlfriend. Now, what he's doing is a big mistake. Now, you will not only tell your mother, you will also tell those two girls and create trouble all sides for him. Yes or no? So, you identified a misstatement. Now, auditor will be evaluating whether this misstatement is important. Not all mistakes are important. Some mistakes you can leave it. If it is a big mistake, then definitely action has to be taken. What action will you take? First action you will take is you will go and threaten him. Hey, this is wrong. What you are doing is wrong. One girlfriend itself, mother will become Khali. Now, you have two girlfriends. Now, imagine what you're doing is very, very wrong. You tell sorry to both the girls and you become a better man today. Like that, you are giving a warning to him. You are allowing him to correct his mistake. If he corrects his mistake, is there a problem? No. He has become a changed man. There is no problem there. But if he does not correct his mistake, then again you will think, okay, I will tell my mother, I will tell those two girls, I will also tell my grandfather. Grandfather will give advice to him. Like that, you will make the whole plan. So, you will identify a misstatement on the audit, and if there is any misstatement uncorrected, then you will see the effect of that also on the financial statements as a whole and when you are forming an opinion in the auditor's report. SA 320, the standard basically deals with auditor's responsibility only. What is auditor's responsibility? The concept of this materiality is applied while planning stage and in the performing stage of the audit and in evaluating the effect of identified misstatement of the audit and also the uncorrected misstatements, if any, on the financial statements and on forming an opinion in the auditor's report. What is financial reporting framework saying? The concept of materiality in the context of the preparation and presentation of financial statements. Although financial reporting framework may discuss materiality in different terms, they generally explain that what is financial reporting framework? The accounting standard is telling materiality such as materiality including omission. There also they're saying materiality includes omission. They are considered to be material if they individually or in aggregate are expected to influence the economic decisions of the users of the financial statements. That means if some matter is going to influence the decision of the stakeholder, then we will call that as material. Judgment about materiality are made in the light of surrounding circumstances and are affected by the size or nature of a misstatement or combination of both. Yes, size is also important. For 5 lakhs, you first spoke about the size only. And then we spoke about the nature. Or both we will be seeing to determine whether something is important or not material. Judgments about matters that are material to users of financial statements are based on consideration of the common financial information needs of the users as a group. The possible effect of misstatement on specific individual users whose needs may vary is not considered. Now, as a group, you will have to see the stakeholders. Employees as a group, government as a group. Yes, government itself is big, so that itself is a group in itself. But if one person is going to see this information and change his decision, doesn't matter, not important. When you are seeing whether it is going to influence the economic decisions of the users taken on the basis of financial statements, you please consider the economic decisions of the users as a group and not just one person. Is that clear? That is what financial reporting framework is saying. So while planning the audit, auditor will make judgment about the size of misstatement. During planning stage itself, auditor is going to make the professional judgment about the size of material misstatement. Why he is making the judgment? This judgment is going to tell what is the audit procedure that you have to do. What extent you have to do your audit procedures. This judgment provides a basis for nature, extent and timing of risk assessment procedure, nature, extent and timing of further audit procedures, identifying and assessing the risk of material misstatement. Now, only if you have a judgment about the size of material misstatement will the auditor know what kind of audit procedures he has to do, his risk assessment procedures, his further audit procedures, and how to find the ROM, that is the risk of material misstatement. Everything he will be able to say only if he makes the judgment about the size of material misstatement. Is that clear? How you are going to remember these three? Net of RAP, net of FAP, and identifying and assessing risk of material misstatement. This is what? Essay 315 heading. Identifying and assessing risk of material misstatement through understanding the entity and its environment. Half of essay 315 is here. So, when the auditor makes a judgment about the size of the material misstatement, the judgment is going to provide a basis for net of RAP, net of FAP, and essay 315. Is that clear? The auditor has to apply his professional judgment in determining materiality, choosing the benchmark, and determining the level of benchmark. I will come to what is benchmark and all of those things. There is a statutory requirement. What is that statutory requirement? We will see. Any income or expenditure which is more than 1% of the total revenue from operations or rupees 1 lakh, whichever is higher, has to be disclosed separately because it automatically becomes material. Companies Act is saying. What is the Companies Act saying? Any income or expenditure which is more than 1% of the revenue or rupees 1 lakh, whichever is higher. So you take that amount, 1% of revenue or 1 lakh, whichever is higher, you take that amount, say 10 lakhs is the amount. Now you are going to see that transactions where you found the misstatement, whether it is going to be less than 10 lakh or more than 10 lakh. Yes, if it is more than 10 lakh, you are going to disclose that separately. This is the first statutory requirement that you have learnt. There is one more statutory requirement. A company should disclose in notes to accounts the shares held in the company by each shareholder who is holding more than 5% shares, specifying the number of shares held. This is also as per Schedule 3 of the Companies Act 2013. Is that clear? What is the statutory requirement? There are two statutory requirements, very, very important. More than 1% of revenue or rupees 1 lakh, whichever is higher. Then if somebody is holding shares more than 5%, then you have to specify the number of shares held, and both of these are as per what? As per Division 1 of Schedule 3 of the Companies Act 2013. Is that clear? Crystal clear? Super clear? Yes. Moving forward, determination of materiality, a matter of professional judgment. Now, when I am making the financial statements, I am making an assumption that the users of financial statements know that these financial statements are prepared to the level of materiality only. That means if I give a disclosure, I thought it was important, I have used my professional judgment and I thought it was important, and that is the reason why I have given this disclosure. And the auditor believes that, auditor assumes that the people who are reading the financial statements actually know that this financial statement is as per materiality only. It is reasonable for the auditor to assume that users have reasonable knowledge of business and economic activities and accounting and willingness to study the information in the financial statements with reasonable diligence. Understand that financial statements are prepared, presented, and audited to the levels of materiality. Recognize the uncertainties inherent in the measurement of amounts based on the use of estimates. Make reasonable economic decisions on the basis of the information in the financial statements. Now, the auditor is making an assumption that the people who are reading the financial statements are actually having some basic knowledge of business and economic activities. That these financial statements are prepared to materiality, users know that already. Whatever uncertainties which is inherent in the measurement of the amount, users know. If I do provision for bad and doubtful debts, does that mean really bad and doubtful debts will be that much amount only? It is a provision for a reason. Yes, there is an uncertainty there. So users know that there is an uncertainty there. And the users, with all the information, they have that capacity, they have the capability to make a reasonable economic decision. All these points, what auditor is doing? Auditor is making an assumption about the users of financial statements. Now we are done with the first part. That is, what is SA 320? What is auditor's responsibility? We saw while planning and performing the audit. What is he going to see? Materiality as per the financial reporting framework we saw. Judgment about size of material misstatement. What is it going to say? The judgment is going to provide a basis for what? Net of RAP, net of FAP and SA 315. What is the statutory requirement and what is this professional judgment that auditor is doing and what is he assuming when he is making the professional judgment? Then comes the concept of performance materiality. Before I go to performance materiality, I want to go back to what is SA 320, that is the basics here. SA 320, that is materiality in planning and performing an audit, states that misstatement including omission, till here I explained to you, are material if they individually or in aggregate could reasonably be expected to influence the economic decisions. What is the meaning of individually or in aggregate? Now you all tell me, if in our company, we already fixed our revenue at 5 lakhs here, sales is 5 lakhs. And you have fixed the materiality level at what? 20,000. Yes. You have fixed the materiality level at 20,000 for a company which is having sales of 5 lakhs. Please be with me now. A person who is doing a mistake has done a mistake for rupees 5,000. Will this mistake be flagged when you're going and doing the audit? Will you find this mistake when you're going and doing the audit? First of all, when you see the 5,000, you will think that it is below the level of importance, below the level of materiality, and you will not find this mistake. Yes or no? This person, say for example, whose name can I take? Mistake, no. Tell some naughty boy's name. Yes, Roshan. He has done a mistake for 5,000 rupees 10 times. Now what happens? Now what happens? The mistake becomes very big. It has become 50,000. Unfortunately, this mistake will not be picked because your materiality level is set only at 20,000. And Roshan has made a mistake of rupees 5,000. Because he's made it 10 times only, now you are able to find out. Now, what actually happened is you saw individually. Individually, when you saw, you will not see this. Individually, when you saw that 5,000, you will not give importance to this because it is lesser than your level of materiality. Agreed? But when you saw that in aggregate, something is getting flagged. When you see it in aggregate, then you know that it has increased your materiality level. Are you able to understand? Individually you saw and aggregate also we saw. For this I have one dialogue. 5 paisa tirna tappa. If you steal 5 paise, it is wrong. No, it is not a mistake. If you steal 5 paise 5 times by 5 people, is it a mistake? Small mistake. If 5 crore people steal 5 paise 5 times, then what? Then big mistake. We all have seen this dialogue. Yes. Now, when it becomes a big mistake, because of what? Because of aggregation, it has become a big mistake for you. Now you read this, you will understand. A materiality includes misstatement, including omissions are material if they either individually or in aggregate are going to influence the decision of the users of financial statements. Clear? Yes. Now you will be setting 2 levels. The first level I will be setting for materiality. What is that level? I have set at 20,000 rupees. Yes, clear? Now, if I set a level for aggregate transactions, now for this, I am setting a level for 3,000 rupees. 3,000 rupees I have set a level for aggregate transactions, or 2,000 rupees I have set a level for aggregate transactions. Now, if there are 10 times making a mistake of 5,000, maybe here it did not get flagged, but here it will definitely get flagged. Now, this level is called as performance materiality. I have set 2 levels. The first level is the materiality level. The second level is the performance materiality level. Materiality level is to find out if there is any individual misstatement. Performance materiality is to find out what? Aggregate misstatement. Are you all clear? Very, very clear. Yes. Now read the concept of performance materiality. I did not read the text, but I made you really clear with the meaning. Now you are going to understand performance materiality. Practically, it is difficult for auditors to design tests to identify individual misstatement. When misstatements are material in aggregate, it takes us to the concept of performance materiality. Performance materiality means the amount set by the auditor at less than materiality level for the financial statements as a whole to reduce the possibility of aggregate, uncorrected and undetected misstatement. If there is a misstatement, I want to catch it just because the number is lower. And if they do it multiple times, if I leave it, then it becomes risky for me. So I will fix a level which is lesser than my materiality level to catch the aggregate transactions mistakes also. Performance materiality is always set at a lower value than overall materiality. Of course, it is set at a lower value. It lowers the risk that auditor will not be able to identify the material misstatement properly. So the auditor will determine two levels, that is materiality and performance materiality, when they are planning the audit itself. If for a particular ABCD misstatement of lesser amount than materiality could be expected to affect the economic decisions, then the auditor will determine materiality for each of ABCD. The second part, what they are saying here is, till now we saw materiality will be set for the financial statements as a whole. Now, just by seeing the revenue, what did I say? That 20,000 becomes the materiality level. Now, this 20,000, whether it is sales, whether it is salary, whether it is some expense, whether it is wages, whether it is stationery, whatever it is, the materiality level is set as 20,000. Now, if I have to set the materiality level for a particular class of transaction, or for a particular account balance, or for a particular disclosure, then in that case, the auditor will be setting the materiality level. There also, the auditor shall also determine materiality for each of the account balance, class of transaction, disclosure. Account balance means balance sheet, class of transaction is P&L, disclosure is notes to accounts. You already know that. Yes, super clear. Now I'm going up. We are done with this part. We are also done with the concept of performance materiality. Now the next concept is benchmark. What is the meaning of benchmark? Now you all tell me, for a 5 lakh revenue making company, what should be the level of materiality? Level of materiality should be 20,000. Good. Now, if the revenue making company is making a sale of 5 crores, what becomes to the level of materiality? What happens to the level of materiality? What will be the level of materiality? It will be 2 lakhs. Yes, 2 lakhs or 20 lakhs, something. 2 lakhs or 20 lakhs. Yes, very clear. Now, say for example, the revenue of the company is 50,000. What should be the materiality level for the company? What should be the materiality level? Here, what is the percentage that you put? 20,000 is what percentage of 5 lakhs? Oh, max question. You all will become blank and you just look at my face like that. Tell me, guys, 20,000 is what percentage of 5 lakhs? You all found the answer? Yes, you did. 4% on 5 lakhs for you to get 20,000. Yes or no? Now, for this scenario, you please tell me what is the materiality level. If you put 4% on 50,000 rupees, how much are you going to get? How much? 4% divided by 100, that means, so 0 will go off. How many zeros are there? 2 zeros, 4 into 5, 20. So 2000 is the materiality level. You all so bad of max you all have. Max should be a subject actually in CA Inter. Why they left it, I don't know. You all simply will take calci for every single thing. Now you all tell me what you guys did. You applied a percentage on the sales figure to determine your materiality level. Yes, be with me. Now you are auditing the expenses. What and all expenses are there? Yes, salary is an expense, wage is an expense, admin cost expense, yes. Operational expenses. What other expenses? Stationery is an expense, office expense, all of this is there. Now, when you are seeing the expenses, when you want to find the materiality level for the expenses, on what should you do the percentage? You can do it on sales. Yes, you can do it on sales. You can do it on total expenses. Yes, very, very good. Whoever said that. You will be applying a percentage on total expenses to find out your level of materiality. That is also correct. Yes. Now, if I want to buy an asset, now how will I find the materiality level? I will be making a percentage on the total asset figure, or I can make a percentage on the sales figure to find out my materiality level. So for each item, the percentage on which I put to find out the materiality differs, correct? That is called as benchmark. Now here, when I put a percentage on sales, I kept sales as my benchmark. Here, when I put a percentage on my total expenses, I kept total expenses on my benchmark. So here, come to the concept of benchmark. Benchmark in determining materiality for the financial statements as a whole. A percentage is applied to the benchmark to determine the materiality level. Example of benchmark could be profit before tax, total revenue, gross profit, total expense, total equity, net asset value. It could be anything. Basically, it should make sense for you to apply a percentage on that particular figure for you to find the materiality level. Now you're clear, crystal clear with the concept of benchmark, with the concept of performance materiality, and with the concept of materiality. Yes. Now under benchmarks, you are also going to read factors that may affect the identification of appropriate benchmark. Now, like I told you, you can apply a percentage on sales, you can apply a percentage on total expense, you can apply a total percentage on PBT. It could be anything. So what should you consider before you apply that percentage? What are the factors that is going to affect for identification of that benchmark? You will be seeing whether it is an asset, or whether it is a liability, or equity, or revenue, or expense. You first find out what is the element in the financial statement. Whether that item actually require the user's attention, you will have to see. What is the nature of the entity and what is the volatility of the benchmark? Say a benchmark can't be keep on going up and down, up and down, up and down. You can't take that as a parameter. If the benchmark is going like this, then yes, of course, you can take that as a parameter because it is predictable in nature. Yes, so that also is a parameter for you to consider whether you can consider a specific item as your benchmark. Benchmark is a point where you will be applying a percentage on that benchmark to find out the level of materiality as a whole. So what are the factors that will affect the identification of the benchmark? You will see whether it is an element of financial statement. What element does it comprise of? Whether this item requires the attention for the users of financial statement. What is the nature of entity? Why is the nature of entity important? Why is the nature important? Say it is a non-profit organization. Can you take the benchmark for a non-profit organization or a trust as profit before tax? Doesn't make sense, right? Doesn't add up. So you will see the nature of the entity also. Everything you will have to consider before you actually figure out your benchmark. After you figure your benchmark out, you're going to apply a percentage on your benchmark to find out your level of materiality. For the benchmark, what is the relevant financial data? The relevant financial data is basically the past, present, and future. What is this past, present, and future, ma'am? Prior period financial result, period to date financial result, budget or forecast, or any changes in the entity. Prior period financial result is the past. Period to date is the current, that is the present. Budget or forecast is the future. So in relation to the benchmark, the relevant financial data includes past, present, and future. Please don't write in your exam past, present, and future. You will have to write this way with the keywords marked in red. Yes. Determining a percentage to be applied to a chosen benchmark involves the exercise of professional judgment. Yes, of course, there is a relationship between percentage and the chosen benchmark such that percentage applied to profit before tax from continuing operations will normally be higher than percentage applied to total revenue. Why will it be higher than percentage applied to total revenue? Because the value of the revenue will be higher. Yes or no? The value of revenue will be much more than the value of profit before tax. If you're going to put 10% on profit before tax, then on revenue, what should you put? Are you able to understand? A percentage applied to profit before tax will be higher than percentage applied to the revenue figure. Now say for example, in our 5,20,000 example itself, you applied 4% to figure out this 20,000. Yes. Now your profit before tax itself is 1 lakh rupees. Or 1 lakh is too much, guys? Profit before taxes 50,000 rupees. Okay, reality check. Profit before taxes 50,000 rupees. Now, what percentage should you apply on this 50,000 rupees for you to get 20,000? Higher than 4% or lesser than 4%? Please tell me that. Yes, the percentage amount should definitely be higher than 4% because here the value is reducing. So, your percentage should increase. Simple max only. Percentage applied to PBT will be higher than percentage applied to revenue, of course, because the value of revenue is higher. Materiality level for ABCD. Whether law or regulation of AFRF affects the user's expectation regarding the measurement or disclosure in case of related party and remuneration and those charged with governance. The key disclosure to the industry in which entity operates, whether attention is focused on a particular aspect of entity's business that is separately disclosed. Next comes the important one, that is documenting the materiality. Should you document the materiality? Why I am telling you it is important is, if they ask you this question in exam, documenting the materiality, where will your mind go? They are asking documenting. That means essay 230. Materiality, essay 320. Where should I go? Like that, you will get confused. But in 320 itself, they are talking about documentation of the materiality. The documentation will be done for the financial statements as a whole. If the materiality is applicable for ABCD, that also will be documented. There are two levels which were material, that is overall materiality and performance materiality. That performance materiality also will be documented, and if there is any changes to the above three, that also will be documented. Can you change the level of materiality into the audit? That is, after few days as audit progresses, can you change the level of materiality? Yes, of course you can revise materiality as the audit progresses. Materiality and audit risk is considered throughout the audit because it helps in identifying and assessing the risk of material misstatement. It determines the net of RAP, net of FAP, and evaluates the effect of uncorrected misstatements on the financial statements and forming an opinion in the auditor's report. Is that clear, guys? Materiality and audit risk, net of RAP, net of FAP, identifying and assessing risk of material misstatement, all these three, where did we already see? When auditor is using judgment. Yes, there we saw judgment part. Go up in the concept book and find that part, read it with your own eyes. Only then you will be able to remember. Where is that? Where is that? Yes. When the auditor makes judgment, then this judgment is going to provide a basis for net of RAP, net of FAP, identifying and assessing ROM. The same points, again here we saw the materiality, and throughout the audit it is considered when net of RAP, net of FAP, identifying and assessing risk of material misstatement, plus evaluating the effect of uncorrected misstatements on the financial statements, and when they're forming the opinion. Is that clear, guys? Essay 320, we started off with what is Essay 320? As an auditor, what is my responsibility? What is financial reporting framework saying? The judgment about size of material misstatement, what is it providing a basis for? What is the law saying? That is Companies Act we saw. And determination of materiality, it is a matter of professional judgment, and auditor is making a few assumptions here. Then we went to the concept of performance materiality, and then to the concept of benchmark. Under benchmark, we saw what are the factors affecting identification of benchmark, that only elements of financial statements, whether it is an asset or liability or equity or reserve, whatever that is. Next, we went to relevant financial data. What is that data? Past, present, and future. Then exercise of professional judgment only. Here also the percentage to be applied is a matter of professional judgment. Then we went to materiality level for ABCD and overall materiality. What are you going to document? And finally materiality and audit risk. Is that clear, guys? SA 320, easy. Were you able to understand? Any doubts? This is the time to ask the doubt. Clear, guys? I will also tell you what you have to do. Say, for example, the entire marathon you have planned for 5 days period. If you have planned the entire marathon for 5 days period, on your day 1, you're watching the marathon, correct? Directly, don't go to day 2 and watch the marathon. Day 3, watch the marathon. Day 4, watch the marathon. Don't do that mistake. What ideally I want you to do is, you take even 6 days. Don't make a 5-day plan. Make a 7-day plan. No issues. Once you make the plan, once your day 1 is getting completed, that day itself, trust me, if you have to go through the standard, you will be sorted. You will be sorted. You don't have to wait for day 7 and then again do the revision. That time it will be much better. You will have full clarity. So ideally, after day 1, that day, if you are watching the lecture, say for 4 hours, you will be revising for 2 to 3 hours. Approximately half the time or little more than half the time of watching the lectures, you will be revising that day itself. If you do, it is gonna take 2 to 3 hours. If you do it the next day, it will take the same number of hours that you took for the lectures. If you're going to do after 5 days, it is going to take much more time than this 4 hours itself. It is a waste of time. Trust me. Day 1, after you finish, you are going to revise for 2 to 3 hours. Day 2, after you finish, day 1's portion you will revise for 30 to 45 minutes, quickly just going through it, and day 2 for 2 to 3 hours. Day 3, once you finish day 1 and 2 together for 1 hour, and then day 3 is for 2 to 3 hours. Like that, you keep going forward. Trust me, in 7 days, the grip you're going to get in all the standards and other chapters, entire audit itself, I'm telling you guys, in 7 days for you to get the grip. This is the plan. This is the plan. Just follow that and then tell me, ma'am, yes, I was able to do it, not able to do it, your plan is waste. You tell all of those things, but 100% genuinely try to follow this. Is that clear? I used to do that, guys. As a student, I used to do that. I used to study that day's work that day itself. Then next day's class, that day I will study. So trust me, at the end of 7 days, you will have that accomplishment feeling. Trust me, that will give you the confidence. When you get that feeling of accomplishment, that itself will give you the confidence. So yes, guys, you will put in that effort for this 7 days, just the 7 days. Commit yourself for just 7 days, not more than that. Don't commit for 30 days, 45 days and all. Just 7 days, you give that commitment to yourself, finish it, and then you go to the next 7 days, and then you go to the next 7 days. 7-day planner works the best. It has worked best for me. I've seen it, I've experienced it. I want you also to experience that magic. Yes, guys, go home today and definitely revise as to whatever is happened in class.
Let's start off with SA 315. SA 315 is identifying and assessing the risk of material misstatement through understanding the entity and its environment. Now, when will this 315 come? The middle of audit or start of audit, end of audit? When will it come? Even before you start the audit, you need to identify and assess the risk of material misstatement. In these places, there is a material misstatement, where there is a possibility of the misstatement. You have to identify and assess. And you also have to understand about the entity and the environment, that is the industry in which it is operating in. Basics before SA 315. Before we enter into the standard, there are a few things that you have to know. What is the meaning of audit risk? What is material misstatement? What is risk of material misstatement? Now, what is audit risk? Audit risk is the risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. Financial statements are materially misstated means financial statements are wrong, and auditor gives a inappropriate audit opinion. That means he says that the financial statements are right. This is called as audit risk. Why not? The financial statements are right and the auditor says that financial statements are wrong. Is this audit risk? This is not an audit risk, but what is the reason for that? The reason is that nobody is going to look at this signature and going to invest the money, give the loan, give their money. They are not going to deal with this company looking at this. But looking at this, they will definitely give the money to the company. So that is the reason as to why this is an audit risk, but this is not an audit risk. So only when the financial statements are materially misstated and the auditor gives an inappropriate audit opinion, it constitutes as a audit risk. The next one is, what is material misstatement? Misstatement means mistake. Material means important. But what is the meaning of this important mistake? The important mistake can be a difference in these four areas. A difference in amount, difference in classification, difference in presentation, or a difference in disclosure. Now, difference between what and what? Between what is reported in the financial statements and what has to be reported as per applicable financial reporting framework. Is that clear? So, misstatement refers to difference between amount, classification, presentation, or disclosure of a reported financial statement item and the amount, classification, presentation, or disclosure that is required for the item to be in accordance with AFRF. Misstatement means the mistake can arise either due to fraud or a error. Now, whether it is fraud or error, who is going to determine? The intention of the management is determined. Yes or no? Whether the intention is there to make the mistake, then it is a fraud. Intention is not there to make the mistake, it is a error. Misstatement can exist at two levels: the overall financial statement level, risk of material misstatement that relate pervasively to the financial statements as a whole and potentially affect many assertions. Risk of material misstatement at assertion is assessed in order to determine the nature, extent, and timing of further audit procedures. So it can be at overall financial statement level, or it can be at assertion level. Based on the assertion level, you will be finding the nature, extent, and timing of the further audit procedures to obtain the sufficient appropriate audit evidence. Now, what is this risk of material misstatement? Risk of material misstatement is split into two: inherent risk and control risk. Detection risk split into two. What is it? Sampling risk and non-sampling risk. So basically, audit risk is split into two: risk of material misstatement and detection risk. Again, risk of material misstatement is split into two: inherent risk and control risk. Detection risk is split into two: sampling risk and non-sampling risk. What is the meaning of audit risk? You all know. Yes or no? What is audit risk? The risk that auditor gives an inappropriate audit opinion when the financial statements are materially misstated. Now, the audit risk is split into risk of material misstatement and the detection risk. What is the meaning of risk of material misstatement? The susceptibility of the account balance. Wow, beautiful. He's telling the definition of risk of material misstatement. Now, again, this is split into. Sorry? Oh, he told inherent. Very worst fellow. You told the inherent risk, not risk of material misstatement. Inherent risk and control risk. Now, what is this inherent risk? That is the susceptibility of the assertion about a class of transaction, account balance, or a disclosure. So, susceptibility of assertion about ABCD to the misstatement, whether it can be material either individually or when aggregated with all the other misstatements before consideration of any relevant controls. Control risk is what? The misstatement is occurring in the assertion that could be material either individually or when aggregated with other material misstatement, will not be able to prevent or detect or correct on a timely basis by the entity's internal control. That means the control risk means the internal controls are not operating effectively and efficiently. They are not able to prevent, detect, or correct on a timely basis. That means the internal control is not operating effectively. The risk that the internal control will not operating effectively is called as control risk. Inherent risk means what? Susceptibility of assertion about class of transaction, account balance, or disclosure to a misstatement that could be material either individually or an aggregate. Basically, if the entire industry fails, then the company who is part of that industry, nobody can save it, it will definitely fail. That is the inherent risk. If ICA determines pass percentage should be only 1%, for CA Inter, Group 2, if they determine like that, then what will happen? That is an inherent risk. It is no more in the control of you, it is in the control of God only. So that is the inherent risk. Don't worry, 21%. I have added the 2. Detection risk is the risk that procedures performed by the auditor to reduce the audit risk to an acceptable low level will not detect a misstatement. That means what? The auditor is unable to detect a misstatement. If the auditor is unable to detect a misstatement, that is called as detection risk. Why he will not be able to detect the misstatement? Either because of sampling risk or because of non-sampling risk. Sampling risk means that the sample is not representative of the population. If the sample is not representative of the population, can he detect the misstatement which is there in the population? No. Non-sampling risk means he has done the wrong audit procedures. In the case of external confirmation, he has done only inquiry. In the case of re-performance, he has done the inquiry. There is a non-sampling risk there. There also he will not be able to detect the material misstatement, but that is not because that the sample is not representative of the population. There is something else which is there. That is non-sampling risk. Audit risk is a function of risk of material misstatement and detection risk. Audit risk is inherent risk and control risk and detection risk. Basically, all you have to remember is audit risk is risk of material misstatement and detection risk. Risk of material misstatement is inherent risk and control risk. Is that clear? Read these questions, write what is there. Inherent, control, detection. Like that you will be writing. Essay 315. Now only we are entering into the standard, identifying and assessing the risk of material misstatement through understanding the entity and its environment. For every standard, if you see, there will be one mind mapping which is given here. It is a very simple standard. That's why the mind mapping is only risk assessment procedure and internal controls. That's all you will be studying in this entire standard itself. What is this risk assessment procedure? Objective of essay 315. Why do you have the standard in the first place? The first objective is to identify and assess the risk of material misstatement. What is the name of the standard? Identifying and assessing the risk of material misstatement. That is the first objective. To identify and assess the risk of material misstatement at 2 levels. One is at the financial statement level and the other one is the assertion level. Why are you going to identify and assess the risk of material misstatement? Based on this, you will be doing your audit procedures to provide a basis for designing and performing your further audit procedure. Now, for the purpose of identifying and assessing the risk of material misstatement, auditor will be seeing 4 things. What are the 4 things? He will first identify if there is a risk. Then he will assess the identified risk. Then he will relate the identified risk to what can go wrong at the assertion level, and he will consider the likelihood of the misstatement. Say for example, girlfriend talking to mama kuti, boy bestie. Then first you will identify, okay, she is keeping secret code for the WhatsApp. In WhatsApp for chat also she has MK written. That means Mama Kuti. MK is written as the name. But she is not allowing you to enter. So first you identified the risk. Then you assessed the identified risk. And then you are seeing whether that Mama Kuti is okay. Now the Chittappa is not there. So if Chittappa only is the Mama Kuti, then you will see whether the Chittappa has the capability. Is he there? No, there is no capability. So you assessed the risk and evaluate whether it is going to pervasively affect the financial statements. Now you understood, okay, no use. This Mama Kuti is not no use for us. No need to invest the time. Relate the identified risk as to what can go wrong at the assertion level. Will anything go wrong? No chance of anything going wrong. So you will consider the likelihood of the misstatement. That means how many times the probability of that misstatement, how many times can it happen, will it occur again, like that you will see. So 4 points here: identify the risk, assess the identified risk, relate the identified risk, and consider the likelihood of the misstatement. For what are these 4 points given? For purpose of identifying and assessing the risk of material misstatement, auditor shall see, identify the risk, assess the risk, relate the identified risk, and finally he will consider the probability of it occurring again and again, consider the likelihood of the misstatement. So first objective is to identify and assess the risk of material misstatement. How he will do the identifying and assessing of risk of material misstatement? The auditor shall see these 4 points. Is that clear? That is the objective of SA 315. Now going to risk assessment procedures. Risk assessment procedures means what? They are the audit procedures which is performed to obtain an understanding of the entity and its environment. Yes or no? So these are audit procedures which is performed to understand about the entity and its environment. For that, the risk assessment procedures includes IO. What is this IO? A stands for analytical procedures. I stands for inquiry. I stands for inspection, and O stands for observation. Analytical procedures, inspection, inquiry, and observation. What is the audit procedures? Overall audit procedures as per SA 500? Error. External confirmation, inspection, inquiry, reperformance, observation, analytical procedures, and recalculation. Only risk assessment procedures. What are the audit procedures? IO. Analytical procedures, inspection, inquiry, and observation. Now, inquiry of management and others within the entity. To whom and all are you going to inquire? First, you will inquire the internal audit personnel. You will inquire the employees, the in-house legal team, marketing personnel, sales personnel, people who are taking care of the risk management. Inquiry is directed towards information system personnel. So, this inquiry has to be done with all the people who are surrounding the organization. So, who are those people? Internal auditor, employees, in-house legal counsel, marketing personnel, sales personnel, risk management function, and information system personnel. So the inquiry has to be done with all of these people. What is analytical procedures? Plausible relationship between financial and non-financial data. Analytical procedure performed as risk assessment procedure may include both financial and non-financial information. Observation and inspection. Now observation means you are going and looking into the process which is done by the management. Inspection means what? Inspection means examining the books and records. You are taking the books and examining. That is the inspection. So what should you inspect? First you take the internal control manual. There will be huge books with thousands of pages. You take those manuals and you inspect those manuals. Documents such as business plan, strategy, records, and internal control manual again. Remove this. Reports which is prepared by the management and TCWG, such as quarterly management reports, interim financial statements, all of those reports, again you will inspect those reports. And finally you will inspect the entity's premises and the plant facilities. You will observe what is happening in the facility. You will observe what is happening in the premise. So for observation and inspection, premise is nothing but the premise means what? That land and building in which it is, that office. Reports which is prepared by management, documents and internal control manual, and entities premises. What are all of these? You will observe and inspect all of these things. For what is the question for this observation and inspection? For risk assessment procedure, we said that it is IO. In that I and O is here, observation and inspection. Don't forget the question. Now, how are you going to understand the entity and the environment? It helps the auditor in planning the audit and identifying areas that require the special attention. Now, if you want to understand about the girl, what will you do? If you want to understand about the girl, what will you do? How is she? What? Follow her. Don't be stalker like that. How will you understand about the girl? You will see how she is coming to the class. Who is dropping her? Okay, one boy is every day coming and dropping her. Like that it will be. Then you will tell the friend, hey, already she is booked. Don't look at her. Already some boy is coming and dropping. Now friend is the worst person at this time. What he will tell? Hey, you look at his face. They have same nose. He is a brother. Like that he will tell. So if you want to understand about the entity, you have to see who are the people who are around that person, whether already booked, whether brother is there, how is the brother looking, is he having the big muscles, all of those things you have to see. So to understand the entity, you also have to see where the entity is operating. So for that, you have to see what is the industry of that entity, what is the regulatory framework of that entity, what is that applicable financial reporting framework of that entity. Now when you go for audit, now entity example, when you go for audit, how will you understand about that entity? How will you understand? You will ask questions to the management. What kind of questions will you ask to the management? What business are you in? What is your sales? Is it 4,000 crores? Like that, first you will ask the questions. You will understand the nature of the entity. Then you will see how is the financial performance. Last year, how was it? This year, how was it? All of those things will help you to understand the entity and also the environment. Understanding the environment is as equal as understanding the entity. Now, relevant industry, regulatory framework and other external factors including applicable financial reporting framework. How is the nature of the entity? You will have to know. Entity selection and application of accounting policy including the reasons for the changes. Entities objectives and strategies and those related business risk that may result in risk of material misstatement. The measurement and review of entities financial performance. You will have to see these 5 points to understand the entity and environment. What are those 5 points? The first one is you will understand the relevant industry, regulatory and applicable financial reporting framework. Second, you will understand about the nature of the entity. Third, you will understand the accounting policy and if there is any changes, what is the reason for the changes in the accounting policy. Fourth, if there is any business risk, every business will have a risk. A petrol business, what is the risk? Evaporation is a huge risk. Groceries business, what is the risk? It is perishable. It will go off. Algi poirum. Therapy business, what is the risk? Poaching. They will take the client and they will go away. So for every business, there is a risk. So when we understand about the entity and the environment, we also have to understand about the business risk that they are having. Apart from that, what else should you see? Their financial performance. What was your sale last year? What was your sale this year? Is there an increase? What is the reason for the increase? Is there a new product line which is developed? Like that, these questions must automatically, you should ask the management even before you start the audit, because this only will help you to understand the entity and its environment. There are 5 points which is given here. All of you please tell me what are the 5 points. Relevant industry, regulatory and other external factors including applicable financial reporting framework. Second, nature of the entity. Third, accounting policies including reasons for the changes. Fourth, entities objectives and the business risk. And last one, measurement of the financial performance. Now the first one we saw that relevant industry, regulatory and other external factor. Industry factors include industry conditions such as whether it is a competitive environment, whether they are only a single player in the market, supplier and customer relationship, how are the technological developments, the medicine industry, so much of technology developments are there. Have you adopted to the technological changes? Like that we should be able to ask the questions to the management. Relevant regulatory factors include the regulatory environment. Regulatory environment includes the AFRF and legal and political environment. Nature of the entity. How will you know about the nature of the entity? You have to ask its operations. It's the cash flow statement. I told you can remember this based on the cash flow statement. So operating activity, investing activity and financing activity. Ownership and governance structure. This is an addition that you have to remember. Its operations, the types of investments that entity is making, the way that the entity is structured and how it is financed. So basically for the nature of the entity, you have to remember the cash flow statement, operating activity, investing activity and financing activity. Example of matters that auditor may consider while obtaining an understanding of the nature of entity includes. Again the same things will flow here. business operations, investment and investment activity, financing and financing activities, financial reporting such as accounting principle and revenue recognition practices. Again, the same cash flow statement. This is basically for nature of the entity. Don't forget the question. You will remember cash flow statement. You will remember operating activity, investment activity, financing activity, but you will not remember for what you studied this. The nature of the entity. Where is that nature of the entity flowing from? Understanding the entity and its environment, we saw 5 points. The first one was relevant industry, regulatory and applicable financial reporting framework. The second one is the nature of the entity. Under nature of the entity, how you will remember the points is cash flow statements. The entity selection and application of accounting policy, including the reasons for the change, whether it is consistently followed from the previous year. If it is not, what is the reason? Why is there a change? Entities' objectives and strategies and those related to business risk. Examples: industry development, new product and services, expansion of the business. These three are examples for any business risk that may result in risk of material misstatement. Measurement and review of entities' financial performance. For this, key performance indicators, period on period financial performance analysis, budget forecast variance analysis and departmental or other level performance report, and credit rating agency report. How will you remember this? Past, present and future. What is the past? Period on period financial performance analysis, that is the past. What is the future? Budget forecast variance analysis. All of this is for the future. What is the present? Present is the key performance indicator. So present, future, past. Present, past and future. Yes. Apart from this, there is an addition: credit rating agency reports. This is for what? How are you going to measure the financial performance? And this is for what? Which question? Understanding the entity and its environment. Don't forget that. Understanding the entity and its environment, there are 5 points which is given. The first one is relevant industry, regulating and other external factors, including applicable financial reporting framework. Second, nature of the entity. What will you remember? Cash flow statement. Third, entity selection and application of accounting policy, including the reasons for the changes. Fourth is business risk. For the business risk, industry development, new product or service, or expansion of the existing product or service. And fifth one is measurement of the financial performance. For that, how you will remember? Past, present and future. Is that clear? Yes. Understanding the entity. It is a continuous process. The understanding establishes a frame of reference within which the auditor plans the audit and exercises professional judgment throughout the audit. For example, there are multiple standards which you will remember here. Assessing the risk of material misstatement. What is standard? Determining the materiality essay. Considering the appropriateness of the selection and application of accounting policy. What is the standard? Essay 510, we saw accounting policy has been consistently followed. Identifying areas and where special audit consideration may be necessary. For example, related party transaction. 550, the appropriateness of management's use of going concern assumption, or considering the business purpose of transaction. Developing expectation for use when to perform the analytical procedures. 520, evaluating when they have to get a written representation, that is essay 580. So how you will remember this? Understanding the entity, it is a continuous process. The understanding establishes a frame of reference within which auditor plans the audit and exercises professional judgment throughout the audit. They can ask this as question and say give examples. Is that clear? Don't only read like this is the heading, I will read like this only. This sentence is there, correct? This sentence can be a question. The understanding establishes a frame of reference within which auditor plans the audit and exercises the professional judgment throughout the audit. Give examples. Then the answer has to be, for example, when assessing the risk of material misstatement to the financial statements, determining the materiality in accordance with SA 320, appropriateness of selection application of accounting policy, identifying areas of special audit, for example, related party, going concern, all those things you will have to write. Performing the analytical procedures, written representation where he has to get. All these points you will be expected to write with just this given as the question. Is that clear? Yes? Now after this, there is only internal control. Again, quickly let us revise what we saw till here. What is audit risk? Risk that the auditor gives an inappropriate audit opinion when the financial statements are materially misstated. Multiple times we have said this again and again and again. Next time when I ask audit risk, it should not come from here. It should come from here. Like how you will sing a song. Are you thinking and singing? Automatically you will be singing to the tune. Same way when I ask audit risk, how it should come? Risk that auditor gives an inappropriate audit opinion when the financial statements are materially misstated. That's it. Simple as that. What is material misstatement? Difference between amount classification, presentation or disclosure of a reported financial statement item and the difference between amount classification, presentation, disclosure as per the item, it should be as per applicable financial reporting framework. Simple as that. Then misstatements can be either due to fraud or error and can be at two levels. One is at the financial statement level and the other one is the assertion level. What are the components of risk of material misstatement? Inherent risk and control risk. What is the meaning of control risk? That the internal controls are not operating effectively and efficiently. That is the meaning of control risk. Yes or no? What is the inherent risk? It is a susceptibility of assertion about a class of transaction, account balance or disclosure to that material misstatement, whether it could be material either individually or in aggregate. Next, what is the detection risk? Detection risk. A risk that the procedures performed by the auditor to reduce the audit risk that exists could be material either individually or in aggregate. There are two types of detection risk. What are they? Sampling risk and non-sampling risk. What is a sampling risk? Risk that the sample is not representative of the population is called as sampling risk. What is non-sampling risk? Inappropriate audit procedures, or he is not able to evaluate the results of the audit procedure, erroneous conclusions, all of those things are non-sampling risk. SA 315, identifying and assessing the risk of material misstatement. Here very simple, we only saw the objective of SA 315. What is the meaning of risk assessment procedure? What are the audit procedures as part of the risk assessment procedures, and how will you see the entity and its environment? And finally few examples we saw. That's all we saw under risk assessment procedure. What is the objective of SA 315? The first one is to identify and assess the risk of material misstatement at two levels, financial statement level and the assertion level. For identifying and assessing the risk of material misstatement, the auditor shall see three things: identify the risk, assess the risk, relate the identified risk, and consider the likelihood of it occurring. Risk assessment procedure, what are the audit procedures? IO are the audit procedures. Analytical procedures, inspection, inquiry and observation. What is that inquiry? With whom will you do the inquiry? Inquiry with the internal audit personnel, inquiry with the employees, inquiry with the in-house legal counsel, inquiry with marketing or sales personnel, inquiry with risk management function, inquiry with the information systems personnel. Now today when you go back home, you will be studying the SA 315. You will revise it today itself. Don't do it from your summary notes. Don't do the revision from summary notes today, because here internal audit personnel, what you will inquire? You have to read the entire sentence. With the employees, what you will inquire? You have to read the entire sentence. Today after going home, you read the concept book once. Only then you will know what you have to inquire. For now you are understanding the concepts. You are putting the keywords into your head. You need to know how to frame the sentence from that keyword. For that, today itself you go back home and you read the entire sentence just to understand as to what is given there. Analytical procedures. Plausible relationship between financial and non-financial data. What is this? Observation and inspection. What should you observe and inspect? Internal control manual, documents and records, reports which are prepared by the management and TCWG or entities, premises and plant facilities. Understanding the entity and environment. How will the auditor understand the entity and environment? He has to see the relevant industry, regulatory and other external factors. Second, nature of its entity. Third, accounting policies including the reason for change. Fourth, entities, objectives and the business risk. And the last one, financial performance. Is that clear? Now you know what you have to write inside the each of the ones. Nature of entity, entity selection, application of accounting policy, Under business risk, what are the example, and financial performance, how you will remember. Yes, take 5 minutes for, oh, this one is still there. Understanding the entity, a continuous process. You just have to remember the standards. Assessing the risk of material statement of the financial statements as per SA 315. Materiality as per SA 320. Appropriateness and selection of the application of accounting policy as per SA 510. Identifying areas of special audit, for example, related parties as per SA 550. Appropriateness of going concern as per SA, or considering the business purpose of the transactions. Developing expectations for performing the analytical procedures as per SA 520. Evaluating SAI for management's oral and written representation as per SA 580. So now 5 minutes, just read through the concept book. Don't see the summary notes. Read through the concept book and see if you are able to recollect all the points before we go to internal control. Let's start off with the internal control. Now we have mind mapping for internal control. Under this, we will be seeing the definition, objectives, benefits, limitation, study of various aspects, and finally we'll go to evaluation, testing, and special audit consideration. For now, you can leave out this part. Only these first 5 we will focus on that, and then we will move to 6, 7, 8. First one is definition, objective, benefits, limitation, and study of various aspects. What is the definition of internal control? First of all, you tell me what is the meaning of internal control. Meaning of internal control is, these are rules which is framed by the management and it is framed for the management. Basically for them, they are having their own rules. Say for example, PVR, there is one person standing outside. What is his job? His job is to allow the people inside only if they have the valid ticket. Same way for Swiggy. What are the internal controls? People who are getting the refund, whether they are really eligible for getting the refund, like that, they will have an internal control system which is framed by the Swiggy, by PVR, by the management, and it is for their own benefit. Now, what is the definition of internal control? It is a process which is designed, which is implemented, and which is maintained by the management, TCWG, or any other personnel to provide reasonable assurance about the achievement of entities' objectives. Now, the first thing you have to remember is, this is providing the reasonable assurance. Usually, as an auditor, we will obtain the reasonable assurance, but this internal control is by management. So, for management, you have to think in the shoes of management. The management is providing the reasonable assurance about achievement of entities' objectives. What is the entities' objectives that they are going to achieve? That is reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable laws and regulations. Now, what is the meaning of each of these terminologies? Reliability of financial reporting means what? There is an internal control for the accounting process. If that internal control is operating properly, the auditor will be sure that he can rely on that financial reporting. Financial reporting is nothing but your accounting only. Effectiveness and efficiency of operations. There is internal control for access card, entry and exit. If you see that it is good, that the internal control is operating effectively and efficiently, then we can be sure that the operations are done effectively and efficiently. Safeguarding of asset. I have an internal control saying you can't remove this camera from here. If you remove the camera and go out, down itself Tata is there. He will ask the question, hey, where you are taking the camera? Like that, I have the internal control. So this internal control is for the safeguarding of the asset. What is this laws and regulation? There are multiple laws, multiple regulations the organization has to follow. For them to follow that, they will have the rules and procedures in the organization. So to achieve the entity's objectives with regard to these four things: reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of assets, and compliance with applicable laws and regulations. What are the objectives of internal control? Here we saw first one is the definition of internal control. The second one is the objective of internal control. What is the objective of internal control? For internal control, there will be general or specific order, special order. What is this general or special order? Say for example, there is petty cash. The organization is framing an internal control saying less than 10,000 rupees, you don't need anybody's approval. That means the general order has been passed there. After 10,000 rupees until 50,000 rupees, you please get the management approval. After 50,000 rupees till 1 lakh rupees, you please get the senior management approval. Post 1 lakh rupees, you get the CFO's approval. Like that, I'm having levels of approval where special order can be given by these three people and general order can be given by the petty cashier itself. So that is the objective of internal control. Transactions are executed in accordance with management's general or specific authorization. All the transactions are recorded at the proper amount, proper account and the proper period. Correct amount, correct account and the correct period. Assets are safeguarded from unauthorized access, use or disposition. Unauthorized access, unauthorized use or unauthorized disposition. The recorded assets are compared with the existing assets at reasonable intervals. That means physical verification of assets happens. So about assets, 2 points are there. First one is general or specific authorization. Second is it has to be recorded at the correct amount, in the correct account, in the correct period. So if all four are satisfied, then you can say that the objectives of internal control is satisfied. Is that clear? Objectives of internal control, 4 points are there. Actually only 3 points are there. The first one is general or specific order. Second is correct amount, correct account and correct period. Third is with regard to assets, safeguarding of assets and physical verification of assets. What is the definition of internal control? It is a process which is designed, implemented and maintained by management, TCWG or any other personnel for achievement of the entity's objectives. What are the entity's objectives? 4 objectives are there. Reliability of financial reporting. What is it? Effectiveness and efficiency of the operations. Safeguarding of the assets. And compliance with laws and regulations. What are the objectives of internal control? General or specific authorization. Correct amount, correct account, correct period. Assets are properly safeguarded and assets are physically verified. This is the objective of internal control. What are the benefits of understanding of internal control? Why should you understand the internal control? Now we already saw that if internal control is operating effectively, the auditor is satisfied that the misstatements here will be less or not. Yes, the auditor is satisfied that misstatements from this area is less. For reliability of financial reporting, they are having the internal control. I saw that the internal control was operating perfectly fine. So I can rely on the data which is given by the company. So the benefit of understanding is identifying the type of potential misstatement, identifying the factors that affects the risk of material misstatement. Now I know that okay, internal control is not operating properly. There is a risk of material misstatement which can happen here. Based on this, I will focus all my energies to that. I will do my further audit procedures to those areas, designing the nature, extent and timing of the further audit procedures. So the benefits of understanding of internal control is identifying the type of potential misstatement, identifying factors that affect the risk of material misstatement, and based on this I am going to design the nature, extent and timing of the further audit procedure. This is what question? Benefits of understanding of internal control. Whenever there is benefits, whenever there are advantages, there will definitely be disadvantages also. That is the limitations of internal control. Internal control can provide only a Reasonable assurance. In the definition itself, we saw it provides a reasonable assurance. It is not 100% assurance. It is not a guarantee from the management. It gives only a reasonable assurance. Human people are involved. That means if human judgment is involved, human error is also possible. That is the limitation. Lack of understanding the purpose in PVR. Internal control is there. That person there is standing. But does he understand why he is doing that? No, according to him, he should stand and he should see the people who are entering. You should see the phone, okay, enter. See the phone, okay, enter. If you show some WhatsApp chat also, okay, enter. You show some Instagram read also, okay, enter. He doesn't understand as to why he is standing there. So that is a limitation, lack of understanding the purpose. There can be collusion among the people. There can be fights among the people saying, you said petty cash, okay ma'am, till 10,000 rupees, no one will do. 10,000 to 50,000, the next person has to do. Like that, they have the levels. Now, if it is 12,000 rupees, what they will do? They will just give it without any approval because it is just little more than 10,000 rupees. So there is some kind of misunderstanding, collusion which can happen between the people. Judgment by the management. Now this internal control is framed by the management for the management. So there is judgment which is made by the management to understand, okay, fixed asset is an important area. I need to make sure that this fixed asset is not disposed without my approval. Like that, they are making the judgment that this is important. So that itself becomes a limitation. Limitation in case of small entity. There is only owner and one more person who is working under him. Between these two people, can I say petty cash less than 10,000, no approval, 10,000 to 50,000, you approve, 50,000 to 1 lakh, you approve. Irukkarade only two people. How can they have those bifurcation and levels? So, in small entities, internal controls are difficult to be implemented. These are the limitations of internal control. It can provide only a reasonable assurance. There is human judgment which is involved in decision making, lack of understanding the purpose, collusion among people, judgment by the management, and limitation in case of small entities. Again, all of you, what are the benefits to understand the internal control? Identifying the type of potential misstatement, identifying the factors that affect the risk of material misstatement. Based on this, he will be designing the nature, extent, and timing of further audit procedures. What are the limitations? Internal control can provide only a reasonable assurance. Is there human judgment in decision making? Third, lack of understanding the purpose of the internal control. Collusion among the people can be there. Judgment by the management. And finally, internal controls cannot be implemented for small entities. Study of various aspects of internal control. Now in the mind mapping, we finished the definition, we did the objectives, we saw the benefits, and we saw the limitations. Now we are going to study of various aspects. Under that we have 4 points: general nature and characteristics of internal control, controls which are actually relevant to the audit, because there will be thousands or even lakhs of control. As an auditor, we need to know what is relevant for us. Extent of understanding the control, how deep I have to go to understand the control, and the components of internal control. For components of internal control, again it is split into control activity, risk assessment procedure, information system, monitoring activity, and control environment. How will you remember this? Crime. C stands for control activity, R stands for risk assessment procedure, I stands for information system, M stands for monitoring activities, and E stands for control environment. Now before going to that, let us first finish off general nature and characteristics of internal control. Under that we will be seeing the purpose of the internal control. Why do we require the internal control? Reliability of entities' financial reporting, effectiveness and efficiency of operation, compliance with applicable laws and regulation, safeguarding of asset. New 4 points. Are you reading here? Where did you already see these 4 points? In the definition, you saw for achievement of the objectives, to provide the reasonable assurance for the achievement of entities' objectives with regard to these 4 objectives. So the purpose of this internal control is the objectives in itself. These 4 you have already seen as objectives as part of the definition. What are the 4? reliability of the financial reporting, effectiveness and efficiency of operations, compliance with applicable laws and regulations, and safeguarding of the assets. Going to the second one. Existence of a satisfactory control environment is not an absolute deterrent to fraud. Just because your internal controls are operating effectively and efficiently, can I say that fraud will never happen in the entity? You cannot say that, because it's only giving a reasonable assurance. It is not a absolute deterrent to fraud. The existence of satisfactory control environment can be a positive factor when auditor assesses the risk of material misstatement. However, it helps to reduce the risk of fraud. It reduces the risk of fraud, but it does not become zero. Conversely, deficiency in control environment may determine the effectiveness of controls, in particular in relation to the fraud. The control environment in itself does not prevent or detect and correct a material misstatement. However, influence the auditor's evaluation of the effectiveness of other controls. The control environment means what? The control environment means the culture in which the organization is taking. Yes or no? Whether they have a conservative culture, whether they have a conjuice culture, whether they are spending eloquently, like that you will have to see. Are all controls relevant to the audit? Are all the controls relevant to the audit? No, only a few controls which are relevant to the audit. The factors which you have to consider to see whether a control is relevant to the audit is SLM, NCC, DRS. What are these factors? What is the size of the entity? If it is a small entity, you don't have to test all the controls. Little bit of the controls you can test. L stands for legal and regulatory requirements. There are a lot of legal issues already happening. Then in that case, we have to test all of them. Legal and regulatory issues. M. Materiality. What is NCC? Nature of the business. C is component of internal control. Another C is complexity of the system. What is DRS? Diversity and complexity of the operation. R is related risk, and S is any specific control which is there to prevent, detect or correct. Now this SLM, NCC, DRS is going to tell you whether all the controls are relevant for the audit. The answer is a simple no. All the controls cannot be relevant for audit. As an auditor, how we are going to determine if a control is relevant for my audit is based on the materiality, is based on the nature of the entity, is based on what is the complexity of the transaction which has happened. I will be considering all these 9 factors for me to take a decision whether this control is relevant for my audit or not. Only if it is relevant for audit, I will pick that and do my audit procedures. Otherwise, I will not even consider that internal control. I already told you there will be thousands or even lakhs of internal controls which is part of the organization. As an auditor, it is not possible for us to test each and every internal control which is there. So already we will be doing sampling basis only. When we are doing sampling, can we project it to the entire population as a whole? No. Whenever you do the internal control sampling, you cannot project it to the entire population as a whole, but still you will be doing it on sampling basis, and you will be finding out which internal control is actually relevant for your audit. How you will find out which internal control is relevant for your audit? By way of SLM, NCC, DRS. Is that clear? What is that SLM, NCC, DRS? Size of the entity, legal and regulatory requirements. M is materiality. N is nature of the entity's business. C is complexity. Another C is component of internal control. D is diversity and complexity. R is related risk, and S is any specific control which is there for preventing, detecting or correcting a material misstatement. Is that clear? You understood why this SLM, NCC, DRS is there? Because it is not possible for the auditor to see each and every internal control which is there. So he has to consider these factors to determine those internal controls that he has to test. That is, he has to do the audit procedures on those internal controls. Nature and extent of understanding of the internal control. How will you understand the internal control? If there is an internal control, whether it is capable to prevent, detect and correct a material misstatement. What is the capability of the design of that internal control to prevent, detect and correct the material misstatement? You will be seeing the design, and second you will be seeing whether it is capable to prevent, detect or correct the material misstatement. The second, they're talking about risk assessment procedures. And the last point is understanding the internal control is not sufficient to test the operating effectiveness of the control. Now, in this risk assessment procedures, what will you remember? IIoT. First you saw error. Second, for risk assessment procedure, you saw IO. Now you are feeling like IIO. So IIO, add one T to it. You drink one tea, you will not feel like that. So IIoT. What is this IIoT? Inspection, inquiry and observation, and lastly tracing the transactions through the information system. What is this tracing the transactions through the information system? It is audit trail. Now we are under nature and the extent of understanding the internal control. Under that only 3 points are there for nature and extent of understanding of the internal control. The first one is evaluating the design of the control, considering the control is capable of effectively preventing or detecting or correcting. The second is risk assessment procedure, and third is understanding the internal control is not the sufficient way to test the operating effectiveness. Under risk assessment control you have IIoT, inspection, inquiry, observation and tracing the transactions. Controls over the completeness and accuracy of the information. Controls over completeness and accuracy of information produced by the entity may be relevant to the audit if the auditor intends to make use of the information in designing and performing the further audit procedures. Internal control over safeguarding of the assets against unauthorized acquisition, unauthorized use, unauthorized disposition may include controls relating to both financial reporting and operating objectives. The last one is the components of internal control. Components of internal control is crime. What is crime stands for? Control activity, risk assessment procedure, information systems, monitoring activity and control environment. He was telling something to this Abdul Kalam. After I saw in his ear itself, control activity, risk assessment, he started shouting like anything. Now what are the components of internal control? Control activity, risk assessment procedure, information system, monitoring activity and control environment. What is this control activity first of all? Control activity is the policy and the procedure in itself. That means this is the control in itself. What kind of controls that they can have? ISPA. What is that ISPA? I stands for information processing. S stands for segregation of duty. P stands for physical controls. Another P stands for performance review. And A stands for authorization. Control activity means this itself is the internal control. This is the policy. This is the procedure. In what ways they can have the policy and procedure. For the information processing, they can have a policy and procedure. Who is going to process the data? Physical control. Whether physically are they entering the office on time, exiting the office on time. That is a physical control. They will have the internal control. Biometric, show the card and go. Like that they will have. Segregation of duties. For petty cash we saw the example. Less than 10,000 somebody was responsible. 10,000, 50,000 somebody was responsible. Performance review. In every company there will be this performance review. HR will have the performance review. Partner will have the performance review. Whether are you working appropriately? Can I promote you to the next level? At adequate times they will have the performance review. And finally authorization. This is ISPA. ISPA is for the control activity in itself. The control activity means what? The control activity is that policy and procedure in itself. The control activity are policies and procedures that help ensure management activities are carried out. That is the ISPA. Is that clear? What is R? Risk assessment process. This is a component of internal control. The entity's risk assessment process. How are you going to identify the risk? This also again you will remember ISPA. There it was double P. Here it is single P. What is this ISPA? Identifying the business risk relevant to financial reporting objectives, estimating the significance of the risk, assessing the likelihood, that is the probability of it happening, and finally deciding about the actions to address those risks. Any risk which is there, first you have to identify the risk, estimate the significance of the risk, assess the probability of it happening again, and finally deciding about the actions to address those risks. This is risk assessment procedure. ISPA. What does I stands for? S stands for, P stands for, A stands for actions. Here you cannot change the order, because first you have to identify, then you have to see the significance, then you have to see the probability of it occurring, and then only you can take the action. If you write action, probability, identify, then it doesn't make any sense. So here the order is very, very important for risk assessment procedure. What is the first ISPA we saw? What is the question for that? Control activity. What is the question for all of this risk assessment, control activity and all? Components of internal control. Under components of internal control, crime la, the first C was control activity. The R was risk assessment procedure. Now going to the I, that is the information systems, including the related business processes relevant to the financial reporting and communication. The auditor shall obtain an understanding of the information system, including the business process relevant to financial reporting. What and all are they going to see for information system? Procedure by which a transaction is initiated, procedure by which it is recorded, how it is processed, if there is any correction as necessary, what is the backup record, are they storing in cloud or are they simply having in books only, how the information system captures the events that are significant, financial reporting process and any controls which is surrounding the journal entry. All these points you will be seeing for information system. M stands for monitoring activities. What is the monitoring of control? Monitoring of control. The auditor shall obtain understanding of major activity that entity uses to monitor the internal control over financial reporting. What is monitoring of control? It is a process to assess the effectiveness of the internal control performance over time. Who will do this monitoring activity? Management only will do the monitoring activity. Auditor will not be doing the monitoring of the activity and all. The management itself will be doing the monitoring activity. It helps in assessing the effectiveness of control on a timely basis. It is an ongoing activity. Management's monitoring activity will include the communication from external parties such as any complaints or any comments which is there. In case of small entities, management's monitoring is often by the owner-manager relationship itself. So under monitoring, the management will be seeing the effectiveness of the internal control. That is the monitoring activities. What is E stands for? Control environment. Control environment means the culture, the ethics which is there. So that is shape PC. What is shape PC? S stands for organizational structure. H is HR policies and practices. A is assignment of authority and responsibility. P is participation by those charged with governance. E is ethics. Another P is philosophy of the management, and C is commitment to competence. Is that clear? That is shape PC. The shape PC is elements of control environment. Control environment means the culture of the organization, the ethics which is there in the organization. Is it clear? All of you, are you in this world or some other world? This world, the components of internal control is crime, control activity, risk assessment procedure, information system, monitoring activities and control environment. In control activity, what is the mnemonic we saw? ISPA with double P. I stands for information processing. S, segregation of duty. P, what? Physical control. Another P, performance review, and A is authorization. This is what? Control activity. That means this is the policy and procedure. This is the internal control. R stands for, what is the mnemonic? ISPA again. What is that ISPA? Identify the risk, significance of that risk, probability of the risk happening, likelihood, and actions to be taken. So these four are for what question? Risk assessment procedure. Risk assessment procedure is where? Under components of internal control. I stands for information systems. Under information system, how they are recording, how it is being processed, who is initiating it, whether they have backup storage, all those generic points are there for information system. M stands for monitoring activities. Under that, what are the points? It is an ongoing process. It has to be done at a timely basis, and monitoring is done by whom? By the management at reasonable intervals and all those points. E stands for control environment. That means this is the ethics, culture which is there. What are the elements of control environment? Shape PC. What is shape PC? S. Organizational structure. H. HR policies and practices. A. Assignment of authority and responsibility. P. Participation by those charged with governance. E. Ethics. P. Philosophy of the management, and C is commitment to competence. Is that clear? Are you understanding the crime? Yes. Under that crime, what are all the points? ISPA for what? Yes. Can we play a small game? Small game. 5 minutes game. And then we can close the class. 5 minutes now itself. And then we can close the remaining tomorrow. Is that okay? Okay. Now I will ask the question. You should answer. Is that okay? No, I will tell the answer. You should tell the question. Yes, sir. You have to read like that only, because in the case study the answer will be given. You need to know from where they are asking. So I will tell you the answer. You tell me the question. Is that okay? The ulta is only difficult. I ask the question. You have to tell the big answer. Now you please tell me identification of the misstatement, identification of risk of mental misstatement, and designing the nature, extent and timing of the further audit procedures. Where did we see? Benefits for the auditor, yes or no, for understanding the internal control. Now the next one is SLM NCC DRS. Controls which are relevant for the audit. Very good. Narrative record, checklist, Mike is hungry. I gave the food to the Mike. Done. For you 2 minutes, 2 minutes. Just 5 more questions I will ask, okay? You tell me, judgment by management is what? It is a limitation of internal control. Others, were you able to tell that? Judgment by the management is a limitation of internal control. Collusion between people. Oh, now you all be like, yes, now I know limitation. Okay, safeguarding of assets. Objectives, where else? In the definition of internal control, safeguarding of asset is there. Compliance with applicable laws and regulations. Same thing. Okay, ISPA. Which ISPA? Double P ISPA. Control activity. Single P ISPA. What is that single P ISPA? Identifying the risk, significance of the risk, probability of it happening, and actions to be taken. What is that double P ISPA? Information processing, segregation of duties, performance review, physical controls, and the boys here, they are not telling. So 3 more questions I am going to ask. 2 more. What is this IO? IO is for what? For risk assessment procedure, under what it comes, IO? What audit procedures? Risk assessment procedure is correct. Under what it comes? Risk assessment procedure was the second point in that. Under that only you told IO. What is the question for that second point? Gone. Risk assessment procedure includes what? Oh, IO is risk assessment. Okay, IAOT. For that, nature and extent of understanding the relevant control. Which one is relevant for me? I have to understand. For that only. Shape PC. What is shape PC? Elements of the control environment. What is S? H. A. P. Participation by E. P. C. Commitment to competence. Okay, last one. What is no, I will not ask what is crime. What is the nature and extent of understanding the relevant controls? This is a question. What is the answer? Reasonable assurance. Wrong. That's one more question. You didn't tell the answer correctly. It is neither effective nor efficient. You tell me nature and extent. Last time I will give you one more chance. Nature and extent of understanding the relevant controls. There are 3 points. Capable for what? Capability for what? For the design of the internal control and whether the internal control is able to prevent, detect and control. No one said that. Second point is what? Risk assessment procedure. Under that, IIoT. What is that IIoT? Inspection, inquiry, observation and tracing the transaction. T is tracing the transaction. Third one, understanding the internal control is not sufficient for the operating effectiveness of the control. Last question, very last question. You tell me past, present, future, where is it? Under examples of what? Oh, examples of the financial performance. Where did we see that financial? Understanding the entity and its environment. Under that 5 points are there. What are those 5 points? Relevant industry, regulatory and applicable financial reporting framework. Nature of the entity. Accounting policy and reason for any changes. Fourth one, business risk and then only the financial performance. He told the wrong answer. He didn't tell correctly. What is the definition of risk assessment procedure? Risk assessment procedure definition. It is the audit procedure which is performed to obtain an understanding of the entity and its environment for what? To identify and assess the risk of material misstatement at the financial statement level and at the assertion level. All of you okay? Getting some clarity. Internal control is not over. Tomorrow we will be continuing this, but a small part is only pending. Only the evaluation and testing part is pending. Actually, we could have completed today itself. It is very small. Till here it's done. Only the evaluation, methods, testing. That's it. Only this. Hardly 10 minutes we will be completing it tomorrow's class. Is that all right? Okay. Thank you guys. I hope you got clarity.
Yes, guys, actually what happened with essay 315 is the part 2 when I recorded in class, only video got captured, but the audio unfortunately did not get captured. But I didn't want you guys to miss essay 315. So for marathon specifically, I'm just doing the next part, that is evaluation, methods, testing, guys. The very small part, hardly 10 to 15 minutes we will be spending here. Going on to benefits of evaluation of internal control by the auditor. So why should an auditor basically evaluate the internal control? It enables the auditor to know a few things. Whether there are any errors or frauds which are likely to be located, whether an adequate internal control system is in use and operating as per planned, whether an adequate internal control system is in use and operating as planned by the management. The same point is again written. Whether any administrative control has a bearing on the work, whether the controls adequately are able to safeguard the assets, how far and how adequately the management is discharging its functions so far as recording of transactions is covered, how reliable the reports or records are, extent and depth of the examination he needs to carry out in different areas of accounting, what would be the appropriate audit technique and audit procedure, what are the areas where control is weak and where it is excessive control, whether some worthwhile suggestions can be given. So these are the reasons as to why an auditor has to evaluate the internal control, to know all of these things. The next one is the methods and evaluation of internal control. Very, very important. There are 4 methods that you will remember: narrative record, checklist, IC questionnaire, and flowchart. The keyword for narrative record is it is an exhaustive description of the system as found in the operation. Say, for example, I keep telling you and you keep writing the notes, correct? That is called as narrative record. The second one is checklist. Checklist is a series of instructions or questions which the member of auditing staff will answer or follow. When you do these workout questions, I know how all of you are doing the auditing workout. You will read the question, you will read the answer, put one tick on top, go to the next one, read the question, read the answer, okay, completed, put the tick on top. That is called as checklist activity. You are basically seeing the suggested answer which is given by ICA is correct for the question, and you are putting your generous tick and you're going to the next step, correct? All of you are actually seeing whether ICA has given the correct suggested answer. That is the way you're studying the workout. Yes, that is the way you're actually studying the workout. In reality, you have to write and practice. That is the proper way of doing the workout questions. So checklist activity is basically having the series of questions and series of instructions which the member of auditing staff will keep on answering. What is the IC questionnaire? It is a comprehensive series of questions about internal control. It is widely used form for collecting the information with regard to the internal control. What is flow chart? The name itself says it is a graphical representation of each part of company system of internal control. The next one is testing of internal control. For this, you have to remember IIO-TR. Risk assessment procedure, you said it is IO. Now, testing of internal control, it is IIO-TR. What is this T? Now, again, we are saying error, IO, IIO. Now, IIO-TR, talking like TR, correct? So, IIO-TR. What is this IIO-TR? Inspection, inquiry, observation, reperformance and testing. T stands for testing here. R is reperformance. Why R is reperformance? It can also be recalculation. We are talking about internal control. What you will calculate in internal control? So you will reperform the entire activity of internal control. So that is why R is reperformance. Now testing of internal controls are performed to obtain SAI about the effectiveness of the design of the internal control and the operations of the internal control. For that, you are going to do the audit procedures like IIO-TR. What is the first I? Inspection of documents, which is supporting transactions and other events. What is the next I? Inquiry of the internal control. O is observation. Reperformance is auditor's independent execution of the procedures and controls, and testing specific computerized application over overall information function. So testing of internal control is IIO-TR. I understand that many of you will be feeling இதெல்லாமே எங்கேயோ பார்த்த மாதிரி இருக்கு மேம், பட் என்னன்னு தான் புரியல. Somewhere definitely this internal control I have seen it. I'm not studying something new, but it is looking very different. It is like Atli movie. Every scene of Atli movie you will feel like you have seen somewhere else, but it will be a new scene. Yes or no? Same way for internal control also. Risk that requires special audit consideration. When you want the special audit consideration, when there is a risk which is involving fraud risk, where there is a risk relating to important economic, accounting or other developments like changes in the regulatory requirements, too much complex transactions are happening. Some risk with respect to related party is there. Degree of subjectivity in the measurement of financial information, where risk involves significant transactions that are outside the normal course of business. In these cases is when you will say that risks are requiring special audit consideration. Now here you saw something called as significant risk, significant transaction with related parties, significant transactions outside the normal course, significant economic, accounting and other development. So how do you identify significant risk? That is the next part. Significant risk are inherent risk. It is there already with both a higher likelihood of occurrence and a higher magnitude of potential misstatement. The magnitude is also high. The probability of it is happening is also high. Then you will be calling that as a significant risk. The auditor is going to assess the assertions affected by a significant risk as higher inherent risk. The following are always significant risk. Risk of material misstatement due to fraud and risk of significant transaction with related party outside the normal course of business. What is this risk of material misstatement? The risk of material misstatement is going to be high when it is for non-routine transactions. That means it is not in the ordinary course of business. It is not routine in nature. Salary, it is an item where it is routine. Research and development, it is a non-routine in nature. So you know what is the meaning of non-routine transaction. So risk of material misstatement is greater for non-routine transactions. Where there is judgment involved, there also risk of material misstatement is going to be greater. So ROM, how you're going to identify significant risk? You will say that ROM due to fraud is always significant risk, and any related party transaction outside the normal course of business is also significant risk. Now, what is this risk of material misstatement? This risk of material misstatement is split into two, where there is high non-routine transactions. Non-routine transactions, if it is high, then the ROM is also high. Where there is high judgment involved, then you will say that ROM is also high. With that, SA 315 itself comes to an end, guys. Now, what they're talking about ROM when it is greater for non-routine transaction. Non-routine transaction examples they have given. Greater management intervention to specify the accounting treatment. Greater manual intervention for data collection and processing. Complex calculations, nature of non-routine transaction which may make it difficult for the entity to implement effective control over the risk. For significant judgments where accounting estimates are involved, where revenue recognition may be subject to differing interpretation, judgment may be subjective or complex, for example, judgment about fair value accounting estimates. So all these are examples as to when risk of material misstatement is high. Why did we talk about that? Because risk of material misstatement due to fraud, when it is there, we are going to call that as significant risk. Why is significant risk important? Because it is going to cause for special audit consideration. So risk that requires special audit consideration, 6 points. In that we saw how we are going to identify significant risk, and there one point was ROM. So ROM increases when there is judgment and when it is a non-routine transaction. Simple. Apart from that, we saw testing of internal control, methods in evaluation, and why should an auditor evaluate the internal control. Yes guys, very easy. I told you the second part is going to take hardly 10 minutes and that's it. I'm sure the first part you have good amount of confidence. The second part also very small, very easy. And yes guys, with this, the biggest standard SA 315 has come to an end. Now I'm moving on to SA 330 guys, that is auditors' responses to the assessed risks. The first question I want to ask you is, where are you assessing the risk? Is any standard talking about assessing the risk? You please tell me, because here in this standard it is clearly talking about responses to the assessed risks. Where did the assessment happen first of all? The assessment happened in SA 315. So basically, SA 330 is like a follow-on standard to SA 315. In SA 315, you identified and assessed the risk through understanding the entity and the environment. So now that is the name of the standard. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Whatever risk that you assessed as part of SA 315, now what is this standard talking about? As an auditor, how should you respond? This standard is basically telling an auditor, you should respond this way after you finish assessing the risk. First step is to identify the risk. Second step is to assessing the risk. Third step is to responding to the risk. This SA 330 is basically the step number 3, that is the response to the assessed risk. Are you able to understand? Now with this in mind, go to the mind mapping. Auditor's responses to assessed risk is split into two. The test of controls on one side and substantive procedures on the other side. Substantive procedures again split into two. Substantive audit procedures and test of details. Test of details again split into two. test of transactions and test of balances. Test of transactions is nothing but vouching. Test of balances is nothing but verification. I think you have already seen this somewhere, yes? Substantive procedures, substantive audit procedure, analytical procedures, and test of details. This again split into two, test of transactions and test of balances. In essay 500, just this part was given. And that time also I told you this part fully is only part of essay 330 itself. The elaborate version of this is only essay 330. Is that clear? Now basically now we are going to talk about how as an auditor we are going to respond to the assessed risk which we did in essay 315. And how are we going to do that? It deals with auditor's responsibility to design and implement responses to the risk of material misstatement which is identified and assessed by the auditor in accordance with essay 315. That is identifying and assessing ROM through understanding entity and its environment. Essay 330 states that. Now we are coming to what is this standard saying. Now, how am I going to respond? I have to have an overall response. The auditor will design and implement the overall response to address the assessed ROM at the financial statement level. What he is going to respond? First he is going to design that response and he is going to implement that response. The auditor will design and perform further audit procedures also in the case it is necessary, whose nature, extent and timing are based on and are responsive to the assessed ROM at the assertion level. There are two things that this standard is stating. The first part is talking about design and implementing overall response. The second part is talking about designing and implementing the further audit procedures. The further audit procedures whose net is based on the response to the assessed ROM. That means now there is an other step I am introducing you to. Step number 1 I told you is identifying the ROM. Step number 2 I told you is assessing the ROM. Step number 3 I told you is response to the assessed risk. Now I am introducing you to another step, that is step number 4. Based on the response, what are they doing? Further audit procedures. Are you able to understand? Very, very clear. Now step number 1 and 2, which standard? Essay 315. Step number 3 and 4, which standard? Essay 330. That is the reason why I said Essay 330 is a follow-on standard to Essay 315. Is that clear? Very, very clear. Now, these 2 points are basically the response point and the further audit procedures points. Based on the response, the step number 4 is he is going to design and perform further audit procedures. Is that clear? Very, very clear till here. What Essay 330 is going to do, you are very clear. Yes, in designing the further audit procedures to be performed, the auditor shall do what? Now we are in which step? In designing the further audit procedures to be performed, the auditor shall consider the reason for the assessment. What is the reason for the assessment given to the ROM? Why did you identified it? Okay. What is the reason for assessment at each ABCD, each class of ABCD? You are going to see. When you are seeing the reason for the assessment, you are also going to consider what is the probability of the material misstatement due to a particular ABCD. Whether risk assessment takes the controls also into the picture, that is the internal controls also into the picture, whether the internal controls are operating effectively, whether the auditor is able to obtain audit evidence to see whether internal controls are operating effectively. Obtain more persuasive audit evidence, the higher the auditor's assessment of risk. If the risk is high, you've assessed it, you have assessed that the risk is high, then the auditor has to get more persuasive audit evidence. Yes or no? In designing the further audit procedure, the auditor will be considering the reason for the assessment. When he is considering the reason for the assessment, he has to consider for each of the ABCD. When he is seeing the reason for assessment for each of the ABCD, he has to consider 2 things: the probability of the misstatement occurring and whether he has considered the internal controls also. Now the auditor has to get more audit evidence in the case where the assessment of risk is also high. Is that clear? Now, The auditor shall design and perform test of controls to obtain sufficient appropriate audit evidence as to the operating effectiveness of relevant controls when the auditor's assessment of ROM at the assertion level includes an expectation that the controls are operating effectively. Now, the auditor's assessment of ROM at the assertion level at ABCD includes an expectation that the controls are operating effectively. That means what? When you are assessing the ROM, you are including internal controls also, because the substantive procedures alone cannot provide SAI at the assertion level. Why is internal controls important? Now, say for example, you are seeing the revenue. You are seeing what? You are seeing the revenue. When you are seeing the revenue, you will be looking at the internal controls which is relevant to the revenue, because this internal control is going to tell you whether there is any revenue leakages and all of those things. Are you able to understand? Yes. So internal controls is also very, very important. Substantive procedures alone cannot provide all the evidences. So the auditor also has to see whether the internal controls are operating effectively. Based on that only, the nature, extent and timing of substantive procedures will come into the picture. Now we are going to the test of controls. There is a beautiful flow to this standard. Are you able to understand that flow? If you are able to understand that flow, then the standard becomes easy. Now the next few points are about test of controls only. So before that, let's make ourselves very, very clear. We started off with auditor's responses to assess risk. I told you how it is flowing from. Step number 1 is identifying the risk. Step number 2 is assessing the risk, which we already saw in SA 315. This step number 3, auditor has to respond to the risk, and based on the response, the auditor will be doing further audit procedures. That is step number 4. The step 3 and step 4 is covered in SA 330. Now, when the auditor is designing the further audit procedures to be performed, the auditor will be considering the reason for the assessment to the ROM, and he also has to see whether more persuasive audit evidence is required if the assessment of the risk is high. When he is seeing the reason for the assessment of the ROM, he has to see at each class of ABCD, and he has to consider the probability of the misstatement and whether he has taken the internal controls into the picture. The auditor will be taking internal controls into the picture because internal controls is important and it is intrinsically related to whatever item that the auditor is seeing. Substantive procedures alone cannot provide sufficient appropriate audit evidence at the assertion level. What is substantive procedures? That is an next part. So basically we are here right now under test of controls. After this we will go to substantive procedures. It has to be in a combination. Test of control should be in combination with substantive procedures. Substantive procedures alone cannot do anything. Is that clear? Both should be there. Now I'm going to test of controls. Under test of controls, we are going to read 5 important parameters. What is the extent? How deep I have to go and test the controls? Designing and performing the test of controls. What should the auditor do when he is designing and performing the test of controls? What should be the timing, whether it should be a particular point or whether it should be a throughout the period, whatever the timing of that test of control. Can I use the audit evidence which I'm obtaining from the previous audits? Is there any specific enquiry that I have to make if I see that there is a deviation in the internal control that is being detected? Is that clear? These 5, if we cover, test of controls point will get covered. The first one is the extent. How deep I have to go. Matters the auditor may consider in determining the extent of the test of control include the following. The frequency, you have to see how frequent the internal control is happening. If it is happening so frequently, then it is important. We have to definitely test it. The time of the internal control, whether it is at the end of the period, whether it is the middle of the period, whether it is monthly, whether it is weekly, whatever, the time of that internal control, we have to consider that parameter also. The expected rate of deviation. Expected rate of deviation means before I go into testing the control itself, I know that this is a risky area. The expected rate of deviation is so high. In that case, how I have to test the control, I will know. If I see the expected rate of deviation, I will determine how I have to test the control also. The next one, any other control, other controls, what audit evidences they are giving. audit evidences from other controls. If they are giving, if they are satisfactory in this control, I will not see as much the relevance and reliability of the control. So all of these points are gonna tell me what is the extent of the test of controls, the frequency, time, expected rate of deviation, other controls, and relevant and reliability of the controls. In designing and performing the test of controls, the auditor shall perform audit procedures in combination with inquiry. Now, when I'm designing the test of controls, what are the audit procedures that the auditor should use? The audit procedure will definitely start off with inquiry. But is inquiry an efficient way? Is inquiry an effective way? Maybe inquiry is an efficient way because it is going to reduce your time. You're only going to ask the question, but inquiry is definitely not effective. So in combination with inquiry, audit procedures will have to do with regard to the operating effectiveness of the control. Determine whether the controls to be tested depends upon other controls. Is there any indirect control? And if so, whether it is necessary to obtain audit evidence supporting the effective operations of those indirect controls also. Now say, how will you see the indirect controls? Say for example, there is an internal control in the organization saying only a salesperson has access to POS. I will go here. What is the internal control that the organization is having? Only a salesperson has access to POS, that is the point of sale. Say for example, in West Side, if you see, who is the salesperson? The person who is scanning your tags and the person who is collecting your money either by way of cash or GPay or whatever that is, the person, he should only have access to the point of sale so that I know if the cash is less, I know exactly whom to catch. In this time, you were responsible for this counter, so that is the reason as to why I am asking you. This is the internal control that is framed. Now, the salesperson has access to point of sale is an internal control, no doubt about that. I am going to talk about an indirect internal control with respect to this internal control. Now, there is a possibility that another person will go there and sit in his place and he is going to scan and he is going to collect the cash, or not going to scan and he is going to collect the cash. For that, I'm going to have an indirect control saying that the password of this salesperson should have alpha numeric and some symbols compulsory, and it has to be 16 characters. Anywhere have you seen? Utmost protection of the password. Now I am framing an internal control with respect to the password, which is an indirect control, which is for what? Basically saying that the salesperson only should have access to the point of sale. This is my main control and this is my indirect control. Now read this. Determine whether the controls to be tested depends upon other controls. Are there any other controls, indirect controls, and if so, whether it is necessary to obtain audit evidence supporting the effective operation of those indirect controls also. How will you test that indirect control? You will go there and you will try resetting the password and you will really see whether the system is taking the 16 characters. If I put 10 characters, is the system throwing the error? If I don't put symbols, is the system throwing the error? Like that, I will see whether this control is proper. The indirect control is proper. Determine whether controls to be tested depends upon indirect control, and if so, whether it is necessary to obtain audit evidence supporting the effective operation of those indirect controls. Now coming to the audit procedures, here we said inquiry along with combination of something else has to be there. Again, they are coming to that point. Inquiry alone is not sufficient. That means what they are trying to say, inquiry with something else has to be there. What is that something else? Inquiry plus what? In this regard, inquiry combined with inspection or reperformance may provide more assurance than inquiry and observation, since observation is pertinent only at one point in time at which it is made. What they're saying, there are three things: inquiry plus inspection, inquiry plus reperformance, and inquiry plus observation. There are three things here. They're taking observation out of the game because when you observe, it is only at one particular point in time. But when you inspect, it could be inspection of a record, could be throughout the period. The records could be for the entire month or for the entire year. I can reperform multiple activities and see. So they are taking observation out of the picture only for the reason that observation is done only at one particular point in time. Observation means what? Looking into the process or procedure where somebody else is performing. Someone else is performing, I'm only seeing whether he's performing right way or wrong way. So they are taking observation out. So they're saying inquiry plus inspection or reperformance will be more effective and efficient. Inquiry plus observation might not be, because observation is pertinent only at one point in time in which it is made. The next one, timing of the test of controls. Timing of test of control is what? Whether it is at a particular point in time or throughout the period for which the auditor intends to rely on those controls in order to provide an appropriate basis. Audit evidence pertaining only to a particular point in time may be sufficient for the auditor's purpose. For example, when testing controls over entities, physical inventory counting at the period end. When you do physical inventory counting, of course you do only at a particular point in time. When you will do throughout the period, sometimes in a bank, there is a security guard. Yes, there is a security guard in the bank. How should be that internal control? Should that be in a particular point in time? Or should that be throughout the period? The security for the bank should be throughout the period. So the timing depends on the facts of the case. The auditor shall test controls either for a particular time or throughout the period for which the auditor intends to rely on those controls in order to provide the appropriate basis. So it could be either. Using audit evidence obtained in previous audits. Now here, in determining whether it is appropriate to use the audit evidence about the effectiveness of control with the previous audit and the length of the time period that may elapse before retesting the control, the auditor is going to consider the following. See, a company is going to have multiple internal controls and it might not be possible for the auditor to test each and every internal control. In that case, the auditor will be relying on few of the internal controls from the previous period and few freshly he will have to do. If he is relying something on the previous period, the auditor has to consider these 5 points. The effectiveness of other elements. Elements of internal control is what? Crime, control activity, risk assessment procedure, information system, monitoring activity, and control environment. Here, 3 of the elements are covered. Risk assessment, monitoring, and control environment. So these 3 points you will have to write with respect to the first point, that is other elements of internal control. The auditor has to consider if he is seeing what? Previous audits, internal control. The risk arising from the characteristics of the control, including whether it is manual control or automated control. Effectiveness of the general IT control. Effectiveness of the control and its application by the entity, including the nature and extent of the deviations in the application for the previous years. What kind of deviation was there? How did they deal with in the previous audit? Whether lack of change in a particular control poses a risk due to change in circumstances. Whether the ROM and the extent of the reliance on the control. All these points we will have to see if we are seeing internal controls from the previous audit. If there is any deviation in the control which is detected, what are the specific inquiry that the auditor has to make? What exact questions he has to ask? The test of controls that have been performed provide an appropriate basis for the reliance of the control. Additional test of controls that are necessary has to be seen. The potential ROM needs to be addressed using substantive procedures. What they have to ask? Specific inquiry to understand these matters and what are their potential consequences to determine all these 3 points. What are they going to determine? Whether the test of controls, whatever has been performed, whether they are appropriate basis for reliance on the control. Can I trust that control? That you should be able to say when you are testing the internal control. When you're testing the internal control, you should also be able to say whether additional test of controls are required or any potential ROM needs to be addressed using substantive procedures. What are substantive procedures? Substantive procedures or audit procedures designed to detect the material misstatement. Till now we were at internal controls. Now we are coming to detecting the material misstatement at the assertion level. Substantive procedures comprises of two things, test of details and substantive analytical procedures. Substantive analytical procedures fully covered in SA 520. Nature and extent of substantive procedures. Depending on the circumstances, auditor may determine that perform only substantive analytical procedures is sufficient, only test of details is appropriate, or combination of analytical procedures and test of details, that only is the best, is the most responsive to the assessed risk. What is this test of details? Test of details is nothing but test of transactions and test of balances. Test of transactions nothing but vouching. Test of balances is nothing but verification. Test of transactions is P&L transaction. Test of balances is balance sheet. Very, very self-explanatory. So basically, which was the hard part out of SA 330? The test of controls is the hard part because lots of points to remember here. Test of controls, coming to the mind mapping again, the sub mind mapping here for test of controls had extent, designing and performing the test of control, the timing of the test of controls, how I can use audit evidence which is obtained in previous audits, specific inquiry when deviations are detected. What is the extent? Depending on frequency, timing, expected rate of deviation, whether there are other controls, and relevance and reliability. In designing and performing test of control, the auditor shall perform audit procedures, that is inquiry plus something else. It could be inspection, reperformance, or observation. I am throwing observation in the dustbin because it is only at a particular point in time and not throughout the period. So inquiry plus inspection or reperformance is perfect. I will also be seeing other indirect controls if they are relevant. What is the timing of the test of controls? Either at a particular point in time or throughout the period. Can I use audit evidences which is obtained from the previous audit with respect to the internal controls? Yes, you can use that, provided the auditor is going to consider the following. What is the following? I will be seeing the elements of the control. What are the risks? That is whether it is manual or automated, and what is the general IT controls, the effectiveness of the application by the entity, what is the nature and extent of deviation, what is the lack of a change or a particular control, what is that possessing the risk, and what is the ROM, and what is the extent of reliance. These 6 points are for what? The auditor is going to consider these 6 points when he is going to use the internal control testing obtained from the previous audits. The last part of test of controls is talking about the specific inquiries that the auditor has to make when there is a deviation which is detected. The specific inquiry is basically to understand the certain matters and to determine whether the test of controls have been provided with respect to which, whether it is able to give the appropriate basis for reliance on the control, whether additional test of control are necessary, whether potential ROM needs to be addressed using the substantive procedure. Then that is giving the flow to substantive procedure. Substantive procedure split into two, test of details and substantive analytical procedure. Substantive analytical procedure completely studied in SA 520. Test of details again split into two, that is test of transactions and test of balances. Test of transactions nothing but vouching, test of balances nothing but verification. Should I do test of details separately? Should I do substantive analytical procedure separately? No, you have to do both together for you to get the best response to the assessed risk. Is that clear, guys? SA 330 with this comes to an end. Now I'm going on to the chapter called Automated Environment, guys. Many people think that it's okay to omit this chapter and go because they think that this chapter is boring. But trust me, Automated Environment, attempt on attempt, they ask for 4 to 5 marks. It has happened in the past and it will happen in the future also. So don't leave out anything. Try to finish 100% of the syllabus. Automated environment, just like all the other standards or other chapters, like how once you finished it, you felt it was easy. Same way for this also, guys. Now, there are 16 Roman numbers. Again, I'm going to tell you each of the Roman numbers is very, very small. And that is the reason why you're feeling as if the mind mapping is big. The chapter as such is not very big. Easy to score that 5 marks. In automated environment, before we get into the mind mapping or the chapter, first of all, what is the meaning of automated environment? What is the meaning of automated? Automated means something is happening on its own. Automated environment means what? Nowadays, everything is automated. People are talking about humanoids. Even cars are automated. Yes or no? We don't need a driver to drive a car. There is a steering wheel. and you can just sit behind. In US, actually automated cars, Teslas are there for cabs. If you book a cab, only a car will come without a driver, Anna, and you just have to sit inside the car and the car will take you to your destination. It has already happened. In India, it is yet to happen, because in India, what should ideally happen is the car should know that there is traffic, that there are potholes, that people will park in places that are not supposed to park. All of those things, it will take time for that car to get trained, but definitely in India also it will come. Yes or no? So automated environment means a place where everything is happening on its own. Nowadays, that is the environment a business is operating on. I told you, once you put a journal entry, automatically the computer itself is preparing the financial statements. You don't have to sit and prepare the financial statements like olden times. I'll tell you, most of the companies don't even enter the journal entry. They just have a scanner. Once you scan, the journal entry is also done, the ledger is done, trial balance is done, the financial statements are done. So when everything is automated, we as auditor, when we go and see that data, we have to understand how the automation is happening. That is the reason why you're going to start off with what is automated environment, what are the key features of an automated environment, how are you going to understand and document the automated environment, is there any risk by using the information technology. See, whenever you see an advantage, there is going to be a disadvantage. Say for example, the AC is on. When the AC is on, the advantage is such that right now you don't feel hot, but there is a disadvantage for using the AC. That is, the temperature, the earth's temperature is going to increase because you're using the AC. So much of carbon emission is happening outside, but we don't bother about that. Right now I'm feeling cold. That is all that I'm bothered about. So every advantage will have a disadvantage. So information technology is giving us something called automation, which is going to basically save so much of time, but whereas there is going to be risk from it also. What is the impact of these risks? So this is the first part that you will be studying. Then you will go to controls. What are the types of control? General IT control, application control, IT dependent control. What is the characteristics of manual and automated control? Suitability, when you should use manual control, when you should use automated control. What are the testing methodology in an automated environment? And as an auditor, how I should audit the automated environment. After that is done, the next one is few topics like data analytics, digital audit, and IFC, internal financial controls. And then we go to how do you document and assessing and reporting. Is that clear? Now don't bother about the entire mind mapping. As always, we are only bothered about the first part. That is what are the features, how as an auditor are we going to understand and document, what is the risk and what is the impact of the risk. What is automated environment? Basically, everything happens automatically. The process is done automatically. Operations are done automatically. Accounting is done automatically. Decision making is also done automatically. It is a business environment where the process, operations, accounting, and even decisions are carried out by whom? By the computer itself. That is only called as information system or IT systems. Nowadays, it is very common to see computer systems being used in every type of business. What are the features of an automated environment? Now, because computer is doing everything, what are the features? You try to tell me the features without seeing the book. Yes, time. That means it is fast. What other features are there? Any other features? There are human errors that is becoming reduced because we are using computer. Usually 5432 is there. When that has to be coming to your answer sheet, if this is there in the question paper, in the answer sheet, you will be writing as 5423 or 5234, something you will write. These errors can be avoided when it is in the automated system. Yes, I hope you all will agree to me when I say this, or anyone is that, ma'am, I've never made this kind of mistake. I'm sure everybody will make some kind of error. I've even seen people who are making errors like this. In the question paper, it will be given as 50 lakhs. In the answer sheet, you'll be writing as 5 lakhs. You'll miss a zero. These errors can be avoided in the information system. So yes, that is a feature of automated environment. Human errors can be reduced. Anything else? So because human errors are reduced, it is more accurate. Whatever data is there, it is more accurate. Now, can you imagine this? If I tell you 43,000 plus 72,432 minus 42,244 minus 32,233 plus 1 lakh plus 324 plus 3,46,000. For some reason, I want you to add and subtract these numbers. How much time will you take for this? You'll take a calculator. You'll be doing all of these things. But if you just put these numbers in Excel with just a formula, even if 100 data set is there as 100, in 1 second, the Excel is going to give. So it basically helps you for large volume of data. What are the features we saw till now? The time taken is low, that is, it is faster. The human errors are reducing. It is more accurate. It helps with large volume of data. Now, when humans are involved, the security of the data might not be there. Because it is there in computer system and I'm putting the password, the data becomes more secure. All of these are features of automated environment. It provides latest information, less prone to human error, better security, better control. It helps for integrating among all the business operations, large volume of data, more accurate, faster business operation, connectivity and networking capability. All of these are features of automated environment. What should you document with respect to automated environment? Understanding and documenting the automated environment. What is the information system that you are actually using? What is the application that you are using? Say, for example, for accounting purpose, I'm using something called as Zoho Books, or I'm using Tally, or I'm using SAP, I'm using Oracle, whatever it is. Mention that, document that, the information system being used. What is the purpose of this information system? It is a financial system or non-financial system. If you go to west side, there will be a tag for every dress. Yes, or any shop, if you go, most of the shops, you can see tags for dresses. And if you go to the billing counter, what are they going to do? They're going to scan that tag. That scanner is a separate application. So you please mention that. For what purpose are you using it? It is for a non-financial purpose. The location of IT systems, is it here only in local or is it all over global? What is the architecture? Cloud-based architecture is the most popular right now, but some people will have client-server based architecture or web application based architecture. So whatever is that architecture, you please document. Version number, which version of the application are you using? 2.0, 5.0, whatever it is, please mention. Interface within the system, in case there are multiple systems, what is the interface that each of the system is using? In-house versus package, that means some people will have the team of IT inside itself, some people will have the team of IT outside of the organization. Say, for example, if you see the Mind and Company, everything for the Mind and Company is a website. Yes or no? In the website only session is getting booked. In the website only therapist gets registered. Everything happens in the website. But it is not an in-house activity. It is a packaged and outsourced activity. Somebody else is maintaining my website. So it is an outsourced activity. If it is outsourced, mention that also. Who are the key people? That is Chief Information Systems Officer, Chief Information Officer. If you study CISA, DISA and all, you can become key persons in some other company. So whatever that is, all these 9 information must be documented with respect to automated environment. What is the information system being used? What is their purpose? What is the architecture? What is the location? What is the version? Interface, whether it is in-house, whether it is packaged, whether it is outsourced. Who are the people who are responsible for the information system? All of these must be understood and documented with respect to automated environment. Is that clear? What are the risks arising from the use of IT system? What is the risk? Because I use this IT system, what is my disadvantage? What is the risk? Inaccurate processing of data, or processing the inaccurate data, or both. What is the difference between these two? Inaccurate processing of data or processing inaccurate data, or both. What is the difference between here? Here they're talking about inaccuracy with respect to the processing. Here they're talking about inaccuracy with respect to the data. Here the data is correct. Here the process is correct, but data is wrong. Here the data is correct, but process is wrong. Are you able to understand? That is inaccurate processing of data, or processing the inaccurate data. Because I'm relying on the information system, I have to go through this risk. You said security in IT system is very high, but if you see my phone, the security that I have is 0000. Anyone can access my phone. Unauthorized access to the data is possible. Direct data changes, backend changes, if they do, everything will get changed. Some people, if they should not have access, and if they have access, they are going to change the backend. Excessive access or privileged access, if you give, then they will change. Lack of adequate segregation of duties, unauthorized changes to the system, unauthorized changes to the program. See, when a change, it should not be done, and if you give unauthorized access, then an unauthorized change will be done. A change, it is supposed to be done, but it is not done. That is also a risk because of IT. Failure to make the changes. And finally, somebody can come and delete. That is loss of data. Inaccurate processing of data, processing inaccurate data, unauthorized access, direct data change, excessive access, lack of adequate segregation of duty, unauthorized changes to system or program, failure to make the changes to system or program, loss of data. All this 8 is risk arising from the use of IT system. What is the impact of IT related risk? Impact of IT related risk. There are 3 impacts. Impact on substantive checking, impact on internal control, and impact on the reporting. Because there are so many risks which are involved, what is the impact of those risks? See here, when auditor has to check the data, he has to check the data. Yes. Now, if he knows that there is risky, he has to check the data twice, or he has to check the data 5 times. A detailed checking has to be done. That is impact on the substantive checking. If I'm not able to rely on the data, I will be doing a detailed checking of the data. What is the impact on controls? It can lead to non-reliance on automated controls, non-reliance on system calculation and accounting procedures which is built into the application. Because of this, the auditor has to do additional audit work. Impact on the reporting. Due to regulatory requirements with respect to internal financial controls, in case of company, it will lead to modification of auditor's report in some circumstances. If I have to put broadly, because of all these risks, auditor has to do more work. Yes, that is the impact of the IT related risk. Nowadays, people are using artificial intelligence to make decisions. That is the reason why AI audit is also coming into the picture. You are auditing the AI, you are auditing the algorithm to see whether the algorithm is tuned with the company. So those kinds of audit is also there. Because IT has its risk, that kind of audit will become very popular. That's why in the end you will be studying about data analytics for audit, digital audit, and all of those things. See here, this part, it is talking about what kinds of audits are there. Because IT is there, features of IT, risks of IT. Because of risks of IT, what is the impact on the IT related risk? Because of all this, you are going to do digital audit, you are going to do AI audit, you are going to do algorithm audit. All of these things are happening because of the risk from IT. Is that clear? Are you very, very clear? Now I'm going to the types of controls which is there in the automated environment. What are the types of controls? General IT controls, application control, and IT dependent control. What is the meaning of general IT control? General IT control has 4 parts under it. You just have to remember the keywords. I will come to what is there inside it also. But for now, general IT controls is 4 controls. That is data center and network operations, program change, access security, application system acquisition, development and maintenance. Data center network operation. Don't keep looking at me. Say also. Now, just because you are at that end of the screen does not mean when I'm saying you'll just look at me like that. Repeat with me. Data center and network operations, program change, access security, application system acquisition, development and maintenance. These 4 are what? They are general IT controls. General IT controls are basically the policies and the procedures that are relating to many applications and to support the effective functioning of the application controls. General IT controls are known as pervasive controls and indirect controls. Why? I'll tell you, they are indirect controls. What is controls over data center and network operations? Here, they will be talking about BCP and DRP. What is the meaning of BCP and DRP? Business Continuity Plan and Disaster Recovery Plan. What is business continuity plan and disaster recovery plan? Whatever happens to my computer, I have to keep on going with my business. My business should not be interrupted because of some problem with my server or because of some problem with my computer. That is your business continuity plan. What is disaster recovery plan? Some failure has happened in the system. Some failure has happened. The business is not going to proceed forward. How fast am I able to recover from that disaster? I should have a plan before itself. That is the disaster recovery plan. This controls over data center and network operations is going to talk about the business continuity plan and the disaster recovery plan. What is this program change? Say, businesses will always change. Yes or no? Programs will always change. Applications, there will be multiple updates to the application. Say, for example, Instagram is an application. Yes. When Insta undergoes an update, what happens to the application? For 1 hour, there will be a downtime, or for 30 minutes, there will be a downtime. WhatsApp, do you remember recently there was an update on WhatsApp, and for 15 minutes or something, you were not able to use WhatsApp. That 15 minutes, you felt like hand was broken. Yes or no? So basically, when an application is undergoing a change, what should happen? The operations should continue. Continuation of the operations must be there with minimal interruption when there is an update, when there is a change in the program. See here, application systems program change controls is to ensure that modified systems continue to meet financial reporting objectives. It includes activities such as change management process, recording, managing and tracking change requests and making and testing the changes. Basically, operation should continue even if there is a program change. What is access security? Access security will talk about application security, data security, network security and physical security. What is the meaning of access security? See here, policies and procedures for application security, data security, or OS security, network security, physical security. Some people will be like, they will have a password for the phone. How many of you all have password to phone? Most of you all will have the password to your phone, no doubt about it. But actually, when I initially got my phone, after my 12th standard is my first phone. 12th standard, I finished the board exams. That day we went to the shop and we got one phone, Samsung phone. That was my first phone. Now, when I got the phone, the only rule that my parents put was you should not have a password for your phone. Nowadays, I'm sure nobody is following that. Everybody is having that password. No one wants you to read their phone. Yes or no? So some people, they will go one step ahead. If you enter into WhatsApp, I just entered into WhatsApp. WhatsApp opened. Now for them, it will not open. For WhatsApp also, they will have a password. So phone is having a password and WhatsApp also will have a password. Application security, OS security is there. Application security is also there. Now if you see, Some people, when you get into WhatsApp, I actually knew about this feature very recently. If you get into some chat, the chat is opening, that chat also they will have the password. That much privacy is required, yes or no? So data security, application security, and operating system security, network security, yes, of course everyone has password for the Wi-Fi and all of those things, and physical security, they will put the phone in a locker and put number lock for the locker also. Physically they are securing the phone. Like this, multiple securities are there, and all of this are under access security. Nobody should access the data. Application security, data security, OS security, network security, and physical security. The fourth is application system acquisition, development, and maintenance. Overall management is to ensure that systems are developed, configured, and implemented. It includes overall management of development activities, project initiation, analysis and design, construction, testing, quality, etc. So these four are what? These four are types of controls in an automated environment. Under that, general IT controls. Under that, these four are the data center and network operation, program change, access security, application system, acquisition, development, and maintenance. The second one is the application control. Now, the first one, that is the general IT controls, we said they are indirect controls, yes or no? General IT controls are indirect controls, policies and procedures that relate to many applications and support the effective functioning. They are only supporting the effective functioning. That is the reason why they are indirect controls. And the second one, application controls, they include both automated and manual control. General IT control, completely automated control. Application control, both automated and manual control. Example of automated application includes edit check, validation of input data, sequence number check, user limit check, reasonableness check, mandatory data field. What is the meaning of edit check? Say for example, I give you a Google Drive link with my book. I actually did that, and by mistake I have given an edit access there. What that person has done in the contents page, like this he has done. No one can read whatever is there. So I was able to see which email ID did that. Are you able to understand? That is the edit check. Person who edited, you will be checking. Next is validation of input data. A person who's putting the data, say what is your name? If I put my name is 12345, the system will throw an error. Only alpha characters are allowed. You cannot say number and all. But nowadays I saw someone number, I think Elon Musk's son, some number was there or something. Yes, in name also number, like Martin Luther King Jr. 2. So like that number is there, correct? So like that nowadays people don't name people like that. So if name is there, number should not be there. Validation of the data. Sequence number check. Say for example, I am asking you, when are you going to write your examinations? If you say Jan 26 or May 26, I should be able to approve. If you say September 25, I am going to say no, September 25 is already over. The system will not accept that data. How can you write your exam in September 25? Like that, I will be able to ask the question. Like that, system itself will be asking the question. That is sequence number check. User limit check. Netflix has user limits. Yes, only 4 people can use in family sharing at the same time. Like that, user limit check. Reasonableness check. Reasonableness check is what? What example can I give for reasonableness check? Say for example, I am asking date of birth. I am saying it is 20th of August 1960. Sorry, 1940. Will you accept? Yes, you will accept. 20th of August 1840. Will you accept this? 1940 itself, little bit you will be shocked. Oh, okay, that much years they are there, like that you will be shocked. 1840 if I say, then system should not accept this data. That is reasonableness check. If I ask your age till 100 years, okay, 120 also okay. More than that and all, I will not accept. Mandatory data field. I am asking, what is your gender? Biological gender. See, nowadays gender is a very sensitive topic. I can identify myself as a keyboard. This is me. Like that people are there. But so what I am saying is biological gender. Biologically You can be either of these two, male or female. I actually saw a form, biological gender M bar F. You have to pick one of these two. Mandatory data field, if someone is asking, male or female is the best example. Mandatorily, you will have to mention what you are. Are you able to understand? That is application control. It could be automated and manual control. Example is reasonableness check, mandatory data field, sequence number check, user limit check, edit check, validation of the data. All of these are application control. Application is automated plus manual. General IT is fully automated, and IT dependent controls are your manual controls. They are your manual controls that make use of some form of data or information or report produced from IT systems. In this case, even though the control is performed manually, the design and effectiveness of the control depends on the reliability of the data. What you have to remember here, I will tell you, it was a RTP question. They asked which one is automated, which one is manual, and which one is both. This was asked once. Once under general IT controls, these 4 points was given in MCQ and you had to find which one is a general IT control. That also they have asked once. So like this, if you know what they can ask, it is easy for you to remember. That is the reason why I told automated environment, it might look hazy, it might look dry, but if you know exactly what to study, it becomes easy. This should be exam point of view. This should be exam orientation. Yes, because to crack the exams, you study the automated environment. Is that clear? Other standards, not like that. To get the knowledge, you study the standard. Automatically, the byproduct is that you will be able to pass your examination. Now, for general IT control, data center, network operation, program change, access security, application security. For application control, it is both automated and manual control. Examples we saw: reasonableness check, data sequence number, mandatory data field, validation of input, edit check. IT dependent control, this is manual data. General IT control versus application control. Is it actually versus application control? It should be and, because the categories are interrelated. The relationship between application control and general IT controls is such that general IT controls are needed to support the functioning of application control, and both are needed to ensure complete and accurate information. So it is actually not versus, it is and. Both are required for a proper functioning, smooth functioning of a company. What are the characteristics of manual and automated elements of internal control which is relevant to auditors' risk assessment? The characters of manual and automated elements are relevant to auditors' risk assessment and further audit procedures. The use of manual or automated elements in internal control also affects the manner in which transactions are initiated, transactions are recorded, transactions are processed, and transactions are reported. What are the controls in manual system? May include the procedures such as approval and review of transactions, reconciliation, follow-up of reconciling items. Controls in IT system, combination of automated controls. These are the controls which is embedded as part of the program itself. Further, manual controls may be independent of IT but may use information produced by IT or may be limited to monitoring the effective functioning of IT and automated controls. See, IT control is there. Manual control is there to see whether IT control is working properly or not. That is also possible. Or IT control is there. There is an exception which is not there for IT control. That can be handled by a manual control. That is also possible. So both are required, like I told beginning itself. When should you use what? When should you use manual control? When should you use automated control? You all tell me if it is all similar kinds of transactions. If they are similar transaction, the best way is to automate it. But if they are non-recurring transactions, unique transactions, then in that case, you can manually see the controls. That is large, unusual or non-recurring transactions, then go for manual. If errors are difficult to define, you're not able to define it. Basically, if you automate it, that means you're coding it. That means you're defining it. Yes, if it is difficult to define or difficult to anticipate or there is no predictability, then manually only you will have to see. There are changing circumstances that requires a control response outside the scope of existing automated control. I told you, in automated control, to handle exceptions, again you are going to come to manual control. So if it is outside the scope, then manual controls become more suitable. In monitoring the effectiveness of automated control, now I have an automated control, whether this control is operating properly. I cannot have another automated control. I have to manually see whether this is or doing this work properly or not. So for that, manual is more suitable. Manual elements are less suitable. That means automated is more suitable here when there are high volume of data or there are recurring transactions, and it can be anticipated, can be predicted, can be prevented, detected and corrected by control parameters. Control activities are there where the specific ways to perform the control can be adequately designed and automated. If it can be automated, then automated is more suitable. Manual becomes less suitable. So what you have to remember is whether it is large data, recurring data, usual data or unusual data. If it is recurring, then automated is more suitable. If it is non-recurring, manual is more suitable. If it is unusual data, manual is more suitable. If it is usual data, automated is more suitable. If you are able to define, anticipate or predict the data, automated becomes more suitable. If there are changes in the existing automated control, then manual becomes more suitable. To see that automated control, obviously you will have to use the manual element only. Is that clear? Moving on to the next one. Testing methods in an automated environment. How will you test it? Now, we all studied AROR. What is that? AROR. They are the audit procedures that the auditor will be doing. Then we went to risk assessment procedure. IIO, TR, everything you studied. Yes. Testing methods in an automated environment is IIOR. What is that IIOR? IIO, you already know, inspection, inquiry and observation. R is reperformance. Again, you will have a doubt whether it is recalculation or reperformance. Here we are talking about testing in an automated environment. What is there to calculate there? That is the reason why it is reperformance and not recalculation. Is that clear? That is IIOR for you. That is testing methods in an automated environment. Inquiry is the most efficient audit test, but it also gives the least audit evidence. Yes, inquiry most efficient, that is time is less, but it gives the least audit evidence. Inquiry should always used with combination with something else. Inquiry alone is not sufficient. Inquiry with what is the most efficient, we have to see. Reperformance is most effective. You have to do the same thing again. Of course, it is most effective audit evidence, but it is not so efficient. It is the most effective and gives the best audit evidence. However, reperformance is very time consuming and gives the least efficient. Therefore, inquiry plus inspection gives the most effective and efficient audit evidence. Is that clear? Very, very clear. In automated environment, what is the best audit procedure to be done? Inquiry plus inspection. If they ask a question saying what is the testing method in automated environment, don't say directly inquiry plus inspection is the best. You will start off with inquiry is most efficient but gives the least audit evidence. Then you will say, so inquiry should always be used with a combination of something else. Inquiry alone is not sufficient. Reperformance, it is the most effective, but there is just too time consuming. It is not efficient. So inquiry along with inspection is the most effective and efficient. Like that, you will have to write as 6 different points in case they are asking the testing methods. What is audit approach in an automated environment? The same approach only. First, risk assessment. Then you will understand and you will evaluate. Then you will test for the operating effectiveness, and finally you are going to report. These 4 points you have to remember. Now I'm going to data analytics, digital audit and all of those things. Till here we will quickly go through. What is automated environment? It is a business environment wherein process, operations and decisions, accounting, everything is by information technology or information systems. What are the features? Large volume of data, it is fast, it is accurate, it is more secure, human errors are less. Those are the features. How should the auditor understand and document the automated environment? What is the information system being used? What is the version? What is the purpose? What is the location? What is the architecture? Who are the people? Whether it is in-house, whether it's packaged, whether it is outsourced. What is the risk arising from use of IT system? Inaccurate processing of data, processing inaccurate data, unauthorized access, indirect changes, excessive access, lack of segregation of duties, failure for changes, loss of data. Impact of IT related risk, more work because more detailed checking has to be done. Impact of control, additional audit work is there, and impact on reporting is also there. Then we went to types of control. Under the general IT control, automated control, and what else did we see? IT dependent control. Sorry, general IT control, application control, and IT dependent control. Under general IT control, we saw data center network operation, program change, access security, application system acquisition, development, and maintenance. Under application control, we saw mandatory data field, user limit, sequence number check, edit check, all of those things. IT dependent control, they are manual control. Then we saw general IT control, it's not versus application control, whereas it is and application control, because both are interrelated and both go hand in hand. Then we saw characteristics of manual and automated environment, and then we went to which one to use where. What is the suitability of manual and automated control? What is the testing methodology? IIO or inquiry, inspection, observation, and reperformance. Audit approach in automated environment, 4 points: risk assessment, understanding and evaluating, testing for operating effectiveness, and reporting, the 4 points. Now I am going to data analytics for audit. What is the meaning of data analytics for audit? It is a combination of process, tools, and techniques for large volume of data. To tap vast amount of data, you will be using data analytics. The combination of process, tools, techniques that is used to tap vast amount of electronic data and to get some meaningful information, and that is called as data analytics. For audit, the auditors will be using CAT, that is computer assisted audit techniques. What are the points? Data analytics can be used in testing of electronic records, that is spreadsheets, and specialized audit tools like IDEA and ACL. These are examples of audit tools. Now, what will these audit tools basically do? They are going to check the completeness of the data. Now, the data is given to you. Now, we have to check the assertion completeness. For that, you can use the tool, audit tool like IDEA, ACL, or CAT to find out whether data is complete or not. Selection of audit samples. Nowadays, no one is going and doing the random sampling around. System itself will be doing the random sample. Like how I showed you random number table list. If you go here, and if I just put generate random number, then what is going to happen? Now, if I go to Google and if I just write generate random number between 1 and 100, then what is going to happen? Automatically a random number is going to get generated. Yes or no? See here. Random number between 1 and 100, 88. I want another number. Again, I can press enter. Again, I can press. See here, multiple things. Filters are also there. 3 digit, 4 digit, 6. How 6 digit and all will come? Whether it, if I give 1 to say 1 lakh, I can give 3 digit, 4 digit, 6 digit, whatever I want. I can, whether I want an odd number, even number, whether I don't want to filter this, I want every unique, duplicates are allowed. See, there is a separate website called random number generated. So everything the computer can do for you itself. Now, it's a selection of audit sample, that is random sampling, systematic sampling, software for that. Now I went to website, now I did all of those things. Imagine if I have a separate software and in that I am able to pick out the random sampling, and based on that I am picking my sample. Extremely, I can be 100% sure that no bias is involved here. If I have to recompute the balances or reperformance, analysis of journal entry, fraud investigation, or evaluating the impact of control deficiencies, all of these things can be done by specialized audit tool itself. Now, that is data analytics for audit. Basically, a tool, a technique to tap to see vast amount of electronic data. And with that vast amount of data, I am going to bring in meaningful information, and that is called as data analytics. Is that clear? Now, what is digital audit? Say for example, in transfer pricing, there is this concept called you have to compare your client with other companies, and then you will be seeing the GP ratio, you will be seeing other ratios and all of those things. For comparing with other companies, where will you get the information? MCA 21 portal, you can get the financial statements. If you pay 100 rupees, some financial statements are free. But apart from that, some people are not going to give you. There is a tool called Provis. You can basically use this tool and get any company's financial statements, and that financial statements automatically, if you export it, it will come to your Excel. That is the beauty of it. So Provis and Capitaline, these are tools to give you information. So in transfer pricing, these two are used a lot. Now digital audit means what? You're embracing the digitization as part of the operations to keep in pace. New technology is helping the company to revamp the operation and rethink the way business are conducted. Automation is the key to digitization. In such a business environment, use of digital technology is being made by auditors right from planning to expression of the final opinion. Until the opinion is given, the automation can happen. Auditors are making use of AI, data analytics, and other latest technologies to help understand the business processes. By using such tools, auditor can conduct the audit in a better way. Because Provis is there, the TP audit will be conducted in a better way. Because Capitaline is there, the TP audit will be conducted in a better way. So digital audit is helping the auditor to identify risks making use of technology. Is that clear? Digital audit is basically, while auditing, I'm doing it digitally. I'm embracing the digitization as part of my audit also. Because when a business is getting automated, the audit also to some extent, it should get automated. Is that clear? Now, what is the meaning of IFC? Multiple times we have seen IFC is nothing but internal control only. This is the policy and procedure for reliability of financial reporting, effectiveness and efficiency of operation, compliance with applicable laws and regulations, safeguarding of assets, and prevention and detection of fraud. This is an additional point that you are seeing here. Documenting the audit. What should the auditor document? Ma'am, already didn't we study documentation as part of automated environment? Here we saw understanding and documenting automated environment. Now again we are seeing documentation. What is the difference between these two? This question should have come to your head as soon as I read that sentence, documenting the audit. Did it come? Did it come or did it not come? If it didn't come, then you have to pay more attention to the class. Yes? Now, documenting the automated environment means the client is using so many things. Now, I am going to document about the client. Yes? Now, here I am going to document about the audit that I have done. That is documenting the audit. So here the auditor will be documenting the discussion among the engagement team and what are the conclusions which has been reached. What is the key elements of understanding with respect to the entity, with respect to environment, with respect to internal control. How have you identified and assessed the risk of metal misstatement? And if you have identified the risk, what are the related controls? You have to basically document everything as part of your audit. The risk identified, related control, the risk of metal misstatement at both the levels, the elements of understanding, that is what is the internal control, source of information, aspects of entity, aspects of environment, and all the discussions, all of these things has to be documented. To whom you will report the audit findings? You will be reporting the audit findings to the shareholders, to the management, to TCWG, to board of directors, to audit committee, to all of these people. At the conclusion of each audit, there will be findings or exceptions in the IT environment and IT controls of the company that needs to be assessed and reported to relevant stakeholders, including management and TCWG. It could be board of directors and audit committee. Some points to consider are as follows. What are the points? Are there any weakness in the information technology controls? What is the impact of this weakness in the overall audit? Is there any deficiency? Report the deficiency to the management in the management letter. Communicate in writing any significant deficiencies if they are there to those charged with governance. You please do all these things. Some points to consider by the auditor with respect to the automated environment and IT controls. Clear? Assess and to whom you will report? To the stakeholders, including management and TCWG. Stakeholders are nothing but your shareholders, bankers. To all of those people you will be communicating if required. Is that clear? In automated environment, we have already revised the first part. The second part, we went to data analytics, digital audit, IFC. Data analytics was what? A combination of process, tools and techniques used to tap vast amount of data. Digital audit is what? It is using like AI, using data analytics to understand the business. For audit, I'm using some digitalization. Example I gave you was Provis. IFC, nothing but internal control, policies and procedures for 4 things: reliability of financial reporting, effectiveness and efficiency of operations, safeguarding of asset, compliance with applicable laws and regulations, and lastly, additional point we saw here, prevention and detection of fraud. Then we went to documenting the risk. What you will document? Whatever discussions with engagement team member, understanding of the entity, understanding of the environment, the risk of material misstatement at both the levels, that is at ABCD level and also at the financial statement level, and whatever risk that you've identified and the related controls you will be documenting. You will be assessing and you will be reporting to whom if there are any weakness in the internal control. What is the impact of that weakness? If there is any deficiency and if there is any significant deficiency, tell to the TCWG. To whom you will be reporting? To the stakeholders, including management and TCWG. Is that clear? Easy. Automated environment. When you saw this mind mapping, you were actually scared, but you understood this is a small part. About everything was about automated, manual, general IT, application IT dependent, and these two were connected. Yes, the first part and the last part was connected, because only if you understand the risks from IT, impact of that risk, what are the features of IT, will you be able to understand about data analytics, digital audit, and all of those things. And last is what you have to document and to whom you have to report. Is that clear? Very, very clear with automated environment. Yes, guys, I hope you are able to appreciate the subject and enjoy the subject, guys.
Listen here, guys. SQC1 and SA220. Both these standards are talking about quality of the audit. What is the difference between SA220 and SQC1? What is the difference? Standards on auditing. SA220 is only for audit engagement, but if you see SQC1, it applies for all kinds of engagement, say review engagement, audit engagement, and any other assurance engagement. Even for related services, this SQC1 will apply. Now, for both SQC1 and SA220, there are common points. The first one is leadership responsibility, ethical requirements, acceptance and continuance of client, assignment of engagement team, engagement performance, and monitoring activities. Once you are done with all these 6 standards itself is over. 2 standards are over. Let's quickly see leadership responsibility. Now, whenever there is a question with respect to SQC1, the terminology that you will be starting your answer is policies and procedures. Now, please see here. The leadership responsibility, SQC1 requires firms to establish policies and procedures for what? The leadership is for the internal culture, because the leader is going to determine what kind of internal culture is there in the team. The best leader we all know is MS Dhoni. So what kind of culture he is having in the organization, you will have to see. The policy will require CEO or partner to assume the ultimate responsibility. Here it will be CEO or partner. On SA220 it will be the engagement partner. So this CEO or partner should have sufficient appropriate experience, ability, and necessary authority. On the other hand, the engagement partner is responsible for the quality of the each and every engagement that he is entering into. He will be responsible that the work is complying with 3 kinds of standards, that is professional standards, regulatory and legal requirements, quality control standards, and he will ensure that the audit report is appropriate, and whatever team members, if they want to raise any concerns, they will be raising the concerns without any fear. Now we are in audit firm. For audit firm, what is the quality that they have to maintain. So for this entire standard, I want you to think of any of the big four, your favorite big four. My favorite is KPMG. So your favorite big four you can think. The second one is relevant ethical requirements. Here again your SQC1 you're going to start off with policies and procedures is going to be there for the firm as a whole and the personnel. ICA has something called as code of ethics. So this firm should have the policies and procedures saying that all the firm and the personnel will comply with the code of ethics which is issued by ICAI. Such policy should allow them to enable the firm to communicate the independence requirements. Independence means whenever they are accepting the client, they should be not related to the client in any way. So that has to be taken care of by the ethical requirements of SQC1. Identify and evaluate circumstances and relationship that create a threats to independence. What is threat to independence? If they are having a share, if the father of the person who is going for article is having a share also, it is a threat to his independence in that case. The responsibility of engagement partner, again he is going to talk about independence only here. So whenever there is ethical requirement question, the terminology is independence. Whether it is SQC1 or SA 220, you will think about independence. Is that clear? For acceptance and continuance of client, SQC1 and SA 220 both are talking about the same issue. 3 points are there: integrity of the client, competence to perform the engagement, and compliance with ethical requirements. Now, a firm before accepting the engagement, he should gather data about the client. In Big Four, there is a software called Sentinel, where if you just put the client's name, not only the client but the whole group will come there, and if there is any case on that group, a criminal activity by that group, anything if it is there will be collated by that Sentinel itself. Now that is going to talk about whether the client is of good integrity, if they have the competence, and whether they have complied with the ethical requirement. What is the meaning of integrity? With regard to integrity of a client, matters that a firm considers include the identity and business reputation of the owner, KMP, related party and TCWG, nature of client's operations, information concerning attitude of client's principal owner, KMP and those charged with governance, whether client is aggressively concerning with maintaining the firm's fees as low as possible, indication of an inappropriate limitation on the scope of work, indication that client may be involved in money laundering or criminal activity, reason for proposed appointment of the firm, and non-reappointment of the previous firm. What are they talking about? Integrity here. What is the reputation of them in the market? What is the nature of the business that they are operating? Are they involved in any illegal transactions? All of those things. What is the attitude of those charged with governance, managers, owners, KMP, and whether client wants to reduce your fees to the utmost lowest level, and inappropriate limitation in the scope of work. That means he will not allow you to do your work properly. Preconditions for audit is not present, or reason for non-reappointment of previous auditor. Previous auditor, if they leave the organization, what is the reason? It is our duty to ask them. So when we get the reason, why have they not reappointed them? All of these things will talk about the integrity of the client. Is that clear? The next is human resources. HR is very important because they will be recruiting the people for the job. That person should be for that job. In SQC1, the firm will establish what? Policies and procedures to provide reasonable assurance that sufficient personnel with capability, competency and commitment. They are talking about sufficient personnel with 3C. Sufficiency talk about quantity, so adequate quantity of people must be there for the 3 C's, that is capability, competency and commitment for professional standard, legal standard and regulatory requirements. On the other hand, assignment of engagement team, who is responsible? The engagement partner is responsible, and he will ensure that all his engagement team members, along with any expert who has been recruited, they have the appropriate 3 C's. What are the 3 C's? Capability, competency, and commitment with respect to the requirements, legal regulatory requirements. Is that clear? The next is engagement performance. This is the most important area. Here we will be talking about EQCR partner. EQCR stands for Engagement Quality Control Reviewer. Now, who is this EQCR partner? Say KPMG is there. In KPMG, there will be one engagement partner who is taking care of one engagement. Apart from that, there will be 1,000 other engagements which is there, and 1,000 other partners who are there. They will say this partner is going to be the EQCR partner of this engagement. Like that, they will appoint an EQCR partner. Now, what is this EQCR partner's job? Basically, whatever work is done by this engagement team, the EQCR partner is going to review that work. Whether the quality of that work is good, the EQCR partner will review. Is it compulsory to have EQCR partner? If it is listed entity, it is compulsory to have the EQCR partner. Is it clear? Engagement Quality Control Reviewer partner. Significant judgments will be reviewed by EQCR partner for taking objective view before the report is issued. For all the listed entities, it is mandatory. For other engagements, the firm will say if it is risky area. In the Sentinel, basically it will give a score after seeing the background. Now, if that Sentinel says 3 out of 10 failed, in that case they will say that EQCR has to be appointed. If it is less than 5, like that, they will have the criteria in the firm itself. In case the engagement partner is there, EQCR partner is there. If there is some conflict between them, EP is saying something, partner is saying completely something else, if they feel like that, the report will not be issued outside to the client until and unless the issue is resolved. Is that clear? Now, there might be difference of opinion with engagement team and EQCR. The report will be issued only after resolving such issues. The matter of difference should be solved by establishing established procedures, that is consulting with another practitioner or another firm or a professional or regulatory body. Very, very important area, EQCR partner. SA 220 for audit engagement. What should we do? SA 220 is saying, you know that EQCR partner has to be there. The responsibility of the EQCR partner being appointed is that of the engagement partner. Everywhere for SA 220, if you see, engagement partner will be there. Engagement partner has the responsibility for direction, supervision and performance of the audit engagement. If EQCR is required, then engagement partner will determine that EQCR is appointed. He will discuss the audit report, he will discuss significant matters, and he will not date the audit report until EQCR review is complete. They can ask multiple choice questions here with regard to the date. Which date is correct? After EQCR date only, audit report dates must be there, and given to client must be only after that. Is that clear? EQCR is whom? For whom is it compulsory, mandatory? For listed entity, it is mandatory. EQCR is a person who is appointed by whom? By engagement partner itself. Now, if there is a conflict between the engagement partner and EQCR, then what will happen? It has to be issued before the audit report is given out. Now, if it is not issued, then the firm will have few policies for them to resolve it between themselves. For them, they will go for another practitioner or another firm or professional or regulatory body. The last part is talking about monitoring, because whatever is done, we have to monitor it, like how we are revising it again and again. Monitoring has to happen. Now here for SQC1, how will they start? Policies and procedures. Policies and procedures is how they will start, and SQC1 is talking about periodic inspection has to be done for completed engagements. For example, 5 years back, something has happened, opinion is given, signed, deliver to the shareholders also. Now I will take that from that burial ground and I will see if everything is correct or not. SQC1 is saying. So completed engagements, periodic inspections has to happen. SQC1 is saying here engagement partner will document 3 things. SA220 is saying 3 things. The issues which are identified, conclusions on the complaints, and conclusions regarding acceptance and continuance of client. Quickly all the 6 again. First one we saw was leadership, where policies and procedures for the internal culture. Who is responsible as per SQC1? CEO or partner has the ultimate responsibility. On the other side, engagement partner is responsible for the quality of each engagement. The second, we went for relevant ethical requirements. Here the policies and procedures for the firm and the personnel for code of ethics issued by ICAI. It should communicate, it should enable the firm to communicate the independence requirements. Here engagement partner should identify the threat to independence and reporting my engagement partner for determining the appropriate action. Acceptance and continuance, in both the cases 3 points are only there. Integrity, competence, and compliance with ethical requirements. The next is human resource. Here policies and procedures to provide reasonable assurance that sufficient personnel, quantity of the people for that work should be adequate. 3 C's and laws and regulations. Same here, engagement partner for the engagement team members and also the experts who are employed. They should also have the 3 C's for the 3 laws. Engagement performance, most important area, we saw about EQCR partner, where EQCR partner will be appointed by the engagement partner. Where engagement partner is there, SA220 is saying. About the EQCR partner, SQC1 is saying. Now what are they saying? It is mandatory for all the listed entities and the report must not leave the organization without the approval of EQCR. If there is conflict of opinion, then they have to resolve that issue, then only give it to the client. Is that clear? The last one is monitoring, where XQC1 is saying periodic inspection has to be done for the completed engagements. That side, documenting 3 things. What are the 3 things? Issues which are identified, conclusion on complaints, and conclusion on acceptance and continuance of client. Easy. 10 minutes we finished SA220 SQC1. Yes or no? Okay, 15.
Finish off the 2 small standards, guys, 260 and 265, often neglected by students and on the contrary, often asked in ICA exams also. So let's not skip anything and quickly, small standard like I already told you, 260 is communication with those charged with governance and 265 is communicating the deficiencies in internal control with those charged with governance and the management. So the first one is communicating with those charged with governance. How should the communication be? What kind of communication should be? 265 is specific to deficiencies in internal control where they're communicating to management and TCWG. Coming to SA 260, that is how should the basic communication be with TCWG? First of all, who is the TCWG? Those charged with governance are the people who are at the top level in the management. So they are the white collared employees, they are the decision making power, they have the decision making authority and they might not be involved in the day-to-day operations or day-to-day activities. Is that clear? Now with this in mind, 260 is talking about communication with the top tier people in the company. So how should that communication be? There is a separate standard called as 260. Now in this standard, we're going to see why do we require the standard in the first place? What is the objective of the auditor? What are the matters to be communicated specifically by the auditor to those charged with governance? How should that communication process be? How adequate should be? And what should the documentation process also be? Why SA 260? This standard basically gives you the auditor's responsibility to communicate with TCWG on an audit of financial statements. What is the objective of the auditor? There are 4 objectives with the auditor. So basically, it should not be like you're talking to a wall. It should not be like you're talking to a wall. You are talking and the other person is responding. There is basically a 2-way communication because whatever information that you are getting is from the client company, it is from the management, it is from TCWG. And You will be giving your timely observation. That means what? It is a two-way communication. 3 points I have already covered. And whatever communication that you're doing with TCWG, it has to be clearly done. And with respect to auditors' responsibilities, you have to communicate with the TCWG. So the first one is to communicate clearly the responsibilities of the auditor in relation to the financial statements audit. By again the lines are starting, responsibilities of the auditor. The second one is I'm obtaining the information, that is the TCWG is giving the information. Third, providing timely observations from the audit, whatever is important and relevant to the responsibility to oversee the financial reporting process. So ideally the objective is to promote effective two-way communication. So the objective of the auditor, there are 4 objectives. First is to communicate clearly the responsibilities of the auditor, obtain information, provide timely observation, promoting two-way communication. What are the matters to be communicated by the auditor? There are 3 matters. The first one is told here itself. What is it? The auditor's responsibility has to be communicated. That is the first point. Auditor's responsibility in relation to the financial statements audit must be a matter which is communicated by the auditor to the TCWG. How are you going to do the audit? How have you planned? What is your scope of audit? What is the timing of your audit? Plan, scope and timing of the audit has to be communicated. And once you do the audit, what are you doing? You are giving timely observations from the audit that are significant, that is significant findings from the audit has to be communicated at a timely basis to those charged with governance. The auditor shall communicate with TCWG all of these things. The auditor's view about significant qualitative aspects of entities' accounting practices, including the policies, estimates, what kind of disclosures they're done, whether it's as per the AFRF or as per the accounting standard, all of those things we will have to see. When they are doing the audit, did the manager actually accommodate them, give all the information, or did the manager say, get out of my office? Difficulty in performing the audit, significant difficulties encountered during the audit. Circumstances that affect the form and content of the auditor's report. Say there is a general way as to how an auditor's report is going to be. If there is a circumstance that is going to affect the contents which is there in the auditor's report, say for example, you want to give an adverse opinion. Normally you will be giving an unmodified, clean report you will be giving, but the circumstances is making me do this, sir. I have to give an adverse opinion. Like, if it is that way, you communicate with the TCWG, or if there are any other significant matters during the audit, please communicate to TCWG. Unless all of TCWG are involved in managing the entity, see, in the operations, if all those charged with governance are actually involved, then you don't have to do this. But if they're not involved, then you have to give them the significant matters which are arising during the audit that were discussed or subject to correspondence with the management. Written representations that the auditor is requesting. So you please tell those charged with governance, if they are not involved in the day-to-day management, about the written representation that you are requesting, and any significant matters which are arising during the audit that were discussed or subject to correspondences with the management. Even if the management is supposed to give you something, you can still go and tell those charged with governance. I don't know why today tongue is rolling too much. In case of the listed entities, okay, this also is happening. In case of listed entities, what kind of communication must be there? Communication with respect to auditors' independence must happen in case of listed entities. Why are they particularly talking about listed entities? Did you all have that thing in your mind? Now, in SQC 1, there is a specific provision which talks about, for listed entities, auditor has to communicate their independence. That means they are not related with the company in any way. They don't hold shares in the company. They have not given loan to the company. Like that, they have to declare their independence specifically for listed entities. Here in SA 260, they're talking about communication of auditors' independence in case of listed entities. The auditor is supposed to give a statement that the engagement team and others in the firm as appropriate, the firm itself, and when applicable the network firms also, they have complied with all the ethical requirements regarding the independence. All the relationships, no matter what, and other matters between the firm, network firm, and other entities, the auditor's professional judgment may reasonably be thought to bear on independence. This shall include the total fees charged during the period for audit and for non-audit services provided by firm. The related safeguards that have been applied to eliminate the threats to independence or reduce them to an acceptable level. In case of listed entities, specifically the auditor has to communicate with respect to his independence. Not only the auditor, the engagement team members and all the other in the firm itself, and the network firm also. Everyone should be independent, because if the company is going for listing, then it is the highest level. Yes or no? Listing means it is a very big company. Then in that case, the auditor of that company must be independent, definitely. So that communication must happen specifically for listed entities. Like I said, it has been given in SQC1, and now we are seeing in SA 260 also. The communication process, how should it be? In case of listed entities, the auditor shall communicate with TCWG about auditor's independence. A statement that engagement team and others in the firm as appropriate have complied with relevant ethical requirements regarding the independence process. What is the adequacy of the communication process? The auditor shall evaluate whether two-way communication, that means both the sides, it should not be like you're talking to a wall. Two-way communication between auditor and TCWG has been adequate for the purpose of audit. If it has not, the auditor will evaluate the effect, if any, on the auditor's assessment of the ROM and ability to obtain sufficient appropriate audit evidence, and accordingly they will be taking the appropriate action. What is the documentation which is required? Where matters required by SA 260 to be communicated are communicated orally. Whatever communication has happened, if it has happened orally, then auditor will include them as per SA 230. Like how in materiality you had a documentation, similarly here also you're having a documentation. So this is 260 integrated with 230. The auditor will include them as part of 230 about when and with whom what is communicated. What is communicated, with whom is communicated, what time it was communicated. Where matters have been communicated in writing, then he will be retaining that copy for his documentation purpose. Communicating any deficiency in internal control reflects the importance of these matters and assists the TCWG in fulfilling their oversight responsibilities. That's it with 260. Like I said, very small standard. Why 260? Objective. What are the matters to be communicated? First we saw 3 matters, and then we went to auditor will communicate other things also. Communication process, how should it be for listed entities specifically? How should the adequacy of the communication process be? And finally, how should the documentation also be done? If it is a oral communication, how should it be documented? If it is a written communication, they'll be retaining a copy. If there is a deficiency in internal control, how should the documentation be? Now when you talk about deficiency in internal control, it brings us to SA 265, that is communicating deficiencies in internal control to those charged with governance and the management. First of all, here you need to understand this terminology called as deficiency. Yes or no? This deficiency means what? Deficiency exists when, in what circumstance when will you say that there is a deficiency? When will you call that deficiency as a significant deficiency? How should the communication be? Is there any examples of indicators of there being a deficiency? How should the written communication happen between the two people? Deficiency is existing, first of all, where there should be an internal control and the internal control is not there. Where there should be an internal control, the internal control is there, but it is not able to prevent or detect or correct a misstatement. In both these cases, we will be saying that there is a deficiency in internal control exists. Are you able to understand? Yes, whenever there is an internal control should be there, but in reality it is not there. Or the internal control is there, but it is unable to prevent, detect or correct a misstatement in the financial statements, then we will be concluding that there is a deficiency in the internal control. What is the meaning of significant deficiency in internal control? When there is a deficiency or a combination of deficiencies in the internal control, that is of sufficient importance to merit the attention of TCWG. That means there is something important which has to be told to those charged with governance. Then in that case, you will be calling that as a significant deficiency in internal control. Please excuse me guys, my throat is just becoming sore, so I have to keep sipping on warm water. That's the reason that small distraction is happening. You guys don't get distracted. Significant deficiency in internal control, it occurs when what? When the auditor will determine whether on the basis of audit work performed, the auditor has identified one or more deficiencies in the internal control. The auditor shall further identify if individually or in combination they constitute significant deficiency. There are no parameters to say that a deficiency is significant deficiency. If it is important to tell something to those charged with governance, automatically it becomes a significant deficiency. Communication against significant deficiencies in internal control to those charged with governance. The auditor shall communicate how in writing the significant deficiencies identified during the audit on a timely basis. The auditor should also communicate with the management on a timely basis. See here, not only to TCWG, but also the communication should happen to the management, because the name of the standard is saying communicating the deficiencies in internal control with those charged with governance and management. This and management part, was it there in SA 260? No, SA 260 only spoke about communication with those charged with governance. 265 is talking about communication of significant deficiencies with those charged governance and the management. That is the reason why you have this sentence, additional sentence here, because the auditor will communicate in writing on a timely basis to TCWG. The auditor will also communicate to the management on a timely basis. How should that communication be? In writing, if there are any significant deficiency in internal control that the auditor has communicated or intends to communicate with TCWG, unless it is appropriate to communicate with the management. Other deficiencies in the internal control identified during the audit that have not been communicated to the management and are of sufficient importance to merit management's attention. So in writing, it has to be on a timely basis, it has to be to the TCWG, it has to be to the management also, it has to be. Now comes examples. Examples of matters that the auditor may consider in determining whether a deficiency constitutes a significant deficiency. Now, few examples for significant deficiency. Examples of indicators of significant deficiencies in internal control. Now, once these examples are done, actually the standard itself is done. One by one, let's go through the example. Now, these first set of examples is a deficiency. When is it becoming a significant deficiency? The likelihood, that is the probability of the deficiency leading to material misstatement in the future. The susceptibility of loss or fraud of an asset or liability. The subjectivity and complexity of determining estimated amounts such as fair value accounting estimates. Financial statements amounts exposed to the deficiency. The volume of activity that has occurred or could occur in the account balance or class of transactions exposed to the deficiency or deficiencies. The cause and frequency of the exceptions which are detected. The interaction of the deficiency with other deficiencies in the internal control. The importance of the control in the FR process. What kinds of control? General monitoring control, control over prevention detection of fraud, control over selection application of accounting policy, controls over significant transaction related party, controls over transactions outside normal course of business, controls over the period end financial reporting process. So all of these are going to tell you whether a deficiency is a significant deficiency. Examples of indicators of significant deficiencies in internal control. What is the meaning of indicator? Say if all of these circumstances there, or one of the circumstances there, it is going to tell you that there is a possibility of significant deficiency in internal control. What are those indicators? Evidence of ineffective aspects of the control environment. Absence of risk assessment process, evidence of ineffective entities risk assessment process, such as management's failure to identify a risk of metal misstatement that the auditor will expect the entity's risk assessment process to have identified. You should have identified as part of your procedure, but you were not able to identify. Evidence of an ineffective response to identify significant risk, that is absence of controls over such a risk. Misstatements which are detected by auditor's procedures are not prevented detected by the internal control. Any disclosure of misstatement due to fraud or error as prior period in the current year. Evidence of management's inability to oversee. So all of this is going to tell you that there could be a significant deficiency in the internal control. The auditor is going to make a written communication to the management and TCWG. What is he going to communicate? A description of deficiencies and explanation. Any other information, not only the deficiency, any other sufficient information to enable them to understand. You will tell the point, and whatever extra additional point is there, you will say that also. Say for example, how I am teaching the standard, extra additional examples if I tell, so that you can understand the standard better, I am giving you that information also. Like that, you have to make the communication so that the other person is able to understand and appreciate as to what you are actually trying to say. Now, with respect to communicating deficiencies in internal control of those charge governance and management, we saw first of all, where does deficiency actually come from? What is there and not working, and what is not there at all, then deficiency will come. If it is a significant deficiency, how will you identify that? If you are able to merit to the attention of TCWG, then you will call that as significant deficiency. How should the communication be? To whom should the communication be? What time it should be, and whether it should be written, oral, all of those things in the third Roman number. The fourth Roman number is a few examples of significant deficiency and examples of indicators of significant deficiency. And finally, how should the written communication be? Very easy, guys. 260 and 265 put together in very less time actually we have completed, because like I said, this is a small standard, very small standard. If they ask, you should be able to get 4 or 5 marks, or even 3 marks they can ask in exam. Whatever it is, full marks it is possible for you to get if they ask in the standard. So don't omit anything. I keep on repeating the same thing. Do not omit anything, because ICA is super smart. You cannot trick ICA. Don't play all your tricks with ICA. You must be ready. ICA wants you to be industry ready. For that, you must be ready with nook and corner in the concept book. Do not omit anything, guys. Is that clear? Yes, guys. And with that, 260 and 265 has come to an end. Now I'm going to start off with essay 300, guys. 300 is planning and audit of financial statements. Now, I'll tell you why this standard is the most important standard, because in all the standards put together, this standards, I am telling you, it is the most important standard, only for the reason that from this standard alone, you can expect 10 full marks. 10 marks, just one standard, and it's not a very difficult standard. That is the reason why I say essay 300 is one of the most important standards. Attempt on attempt, approximately 10 marks from just this standard. Every attempt without missing, ICA has been asking. So we have to be thorough, word by word, to the T. We have to be thorough with this standard. This standard is very important because it is talking about planning and audit of financial statements. Basically, how are you going to plan? Yada pannalo, plan panni pannano. So when you go for audit also, you have to plan for it, and then only you have to start conducting the audit. Now, anything in life, when you start doing that, there must be a plan. Yes, you all are writing exam. When? In how many months are you writing the exam? You're writing the exam in 2 months. Yes. You're writing exam in 2 months. Now, for this 2 months, what are the things that you have to do? You have to study 4 subjects, not 3 subjects per group. It's 4 subjects per group, because accounts, law, DT and IDT. Same way for group 2. Costing, Audit, FM and SM. There are 4 subjects that you have to allocate if you are writing one group and 8 subjects that you have to study if you are writing both the groups. And for that, the time you have is 2-month period. Yes or no? Yes. Approximately about 2 months is there. Now, how you are going to study? Whether you have to go for class, should you consider the class? Or no ma'am, already I have studied previously, with little bit more effort, I will be able to study. Self-study. Okay, should you study by self? If it is a self-study, if you keep on studying by self, you will get bored. So should I study along with my group? Selecting the group is very, very important, because once you select the group, you are going to travel with that person for a particular period of time. Yes. So these people should not be toxic. These people should help you to study and all of those things. So how should the help happen? Say for example, 3 people are in the group. If 3 people are in the group, this is actually the best. With whatever I have seen, I have always done group study all my life. If there are 2 people, if both of them start talking, then it is time waste for him also, time waste for this person also. Say for example, there are 3 people. Now there is a possibility that these 3 people, how they will study, even if one person is distracted, these 2 will call them. If one person is good, these 2 are distracted, this person is going to call them. If all 3 distracted, no one can save them. Yes, that is a different story. But 3 is that sweet spot which you can have for the group. Actually, for me, it has worked. I've seen it work. So now when 3 people are there and all 4 subjects you have to study. Now each person takes responsibility for each of the subjects. Say for example, accounts, law, DT and IDT, this person, tax, this person will take the responsibility. Now this person will teach accounts to these 2. This person will teach law to these 2. And tax will be taught by the 3rd person to the 1st and 2nd person. Like that, some understanding can happen between these 3 people. And then after that happens, all 3 people will see, okay, we all lack understanding in some areas. Should we go for some crash batch? Crash class, we can just get one recording, all 3 will share. Like that, some planning can happen, and this planning will happen initially itself. Yes or no? Now when you come to audit also, similar kinds of planning only happens. How should I conduct this audit? How many people are there required for this audit? Who is going to do what work? Should we need any external support? All these things you will be doing as part of your planning of the audit of financial statements. With respect to SA 300, I will show you the mind mapping. You will be starting off with benefits of planning. Then you go to what is audit planning and what is RAP, risk assessment procedure, which you already studied in SA 315. Then comes elements of planning. Under elements of planning, there is preliminary engagement activities and planning activity. Preliminary engagement activities are basically those activities which you will be doing even before you accept the audit. There are 3 preliminary engagement activities. When you come to the planning activities, it is split into 2. Overall audit strategy and developing an audit plan. If you see the second part itself is like a chart. Yes, what is a chart? The elements of planning are 2. Preliminary engagement activities and planning activities. Don't keep looking at the screen. It's okay. Talk to me. Elements of planning is split into 2. Preliminary engagement activities and planning activities. Planning activities again split into 2. Overall audit strategy and developing an audit plan. What happens in this overall audit strategy? What happens in development of the audit plan? That will come to later stage. For now, you need to understand this. Chart is there. That's it. Audit strategy, what is it? What is audit plan? Is there any documentation that you have to follow? SA 230 reference, planning, supervision and review of the work of the engagement team members. Now, so many people are there. How are you going to review the work of all the team members? Then this is a separate concept in itself, that is audit program. That is the reason why it is given separately. With respect to audit program, you're going to see what is the definition, how you will be constructing the audit program, what kind of audit evidence it will give, what are the advantages of doing this audit program and what are the disadvantages, how are you going to eliminate those disadvantages. All of these, if you finish, SA 300 itself is over. And like I said, you can put 10 marks in your pocket. Is that clear? Because this is important, I will go really slow with respect to SA 300 because I have to have the confidence that you all are understanding. Is that clear? Are you all ready for the 10 marks of SA 300? Yes? Now I'm gonna start off with benefits of planning. What are the benefits of planning? Now, when you did this activity, what did you see as the benefits of planning? There will be similar benefits of planning for audit also. It helps to devote proper attention to important areas. How does it help to devote proper attention to important areas? Now, I know many of you, when I started with this question, you would have gotten a panic attack. Yes or no? Or whenever you are watching the video, if it is less than these months, gone. Yes or no? Panic attack for sure. Now, actually, if you see now, there is not 2 months. There is only 1 point, little more than 1.5 months. That is the reality. Yes or no? If you actually calculate 1.5 months, so a little more is there. But if people who are watching the video right now, imagine for you only 1 month is there or only 15 days is there, more panic attack. So basically what happened when we did this planning strategy is something in your mind told you what and all I am doing right now. Talking to girlfriend, put it in dustbin. Scrolling, doom scrolling, always scrolling on the phone. I will be more mindful. Talking in the night, don't. Going out and eating, don't. For many people, ma'am, this is the reality. This is the reality. I know what CA students are actually doing. Not girlfriend, not much of scrolling, no talking, no one is there, ma'am, to talk. The reality, I will tell you, what is the biggest enemy? It is sleeping. Now you know, okay, only so much time is left. I have to regulate all of these things. Basically, you will be devoting proper attention to important areas. It helps the auditor to identify and resolve potential problems on a timely basis. Potential problem means in the future it might come. That I am resolving now itself. What is a future problem? See, when girlfriend fights or boyfriend fights or even a friend fights, your mental peace is gone. Or if they say some word, I know many girls usually do this. If some word is being said, they would have told only once, but it will get replayed in our head for 100 times. Yes or no? That is the reality. So that is a potential problem. For that, now itself I will cut it off. You please don't talk to me for 2 months. I am not breaking up nothing. I am not asking people to break up. I am asking you to give it a pause, just a pause until exams. Then you can click the resume button after exams. I will not ask any question. Right now, this is not the time for all of these things. So identify potential problems and resolve the potential problems on a timely basis. It helps the auditor properly organize and manage the audit engagement so that it is performed in an effective and efficient manner. Your studying should happen in effective and efficient manner. You have to finish CA in this particular time period. Finishing CA after 20 years, it is not efficient. Maybe you are effective. The CA completion has to happen within that time period. ICA has given 4 or 5 years. But in your head, you will have, okay, already so many years passed. Now at least I have to finish. CA final at least, first attempt I have to finish. All those things you should have in your mind. Assisting in the selection of engagement team members. In our example, these 3 were the team members to study together. Facilitating the direction and supervision of the engagement team members and review of their work. We have to keep on seeing. Usually in a group, I'll tell you what happened. One person will be over enthusiastic. So that person will keep on doing their work. But these 2 people will not be doing the work. So continuous review, continuous monitoring whether all 3 people are actually working towards the goal has to happen. Review of their work. Assisting where applicable in coordination of work which is done by experts. Then these 3 people will decide whether expert is required, whether wow class is required. Like that, those three people will see. So these are the 6 points for benefits of planning. It helps the auditor to devote proper attention to important areas. It helps for him to resolve for all the potential problems. It helps to organize the audit engagement so that it is performed in both effective and efficient way. It assists in selection of the engagement team members. It facilitates in direction, supervision and review of the engagement team members' work. And finally, assisting for the coordination of work if applicable by experts also. These 6 are what? They are the benefits of planning or why planning is necessary. After establishment of the overall audit strategy, an audit plan can be developed to address the various matters. Here what I want you to notice, they are saying after this step comes this step. After establishing the overall audit strategy, you will be developing an audit plan. Now comes audit planning. Planning is not a discrete phase, but rather a continual and iterative process. Now, you all tell me, say for the next 1.5 months, I am giving you a day-wise planner. Day-wise planner, I am telling you day 1 what you have to study, day 2, day 3. For the next 45 days, I am giving you a day-wise planner. Now what will happen? The first 3-4 days, what is high? Motivation is very high. On the 4th or 5th day, the motivation will slightly drop. In the 7th day, you are out of the system. You are out. Yes. Now on the 8th day, what is going to happen? On the 8th day, say for example, these 7 days I have given a planner for 4 to 5 hours per day. If you study, it is sufficient. Effective study of 4 to 5 hours. Now because the 7th day you are out, 8 and 9 you are going to stress. Ayyo, I was not able to complete as per the plan. 10th day, what is going to happen? Are you going to continue the plan or fresh plan? No, we never continue the old plan and all. We are going to make the fresh plan on the 10th day. I'm not saying this is wrong, but I am only telling you that planning is something which continuously happens, and it is not like one day I give this and I go missing in action. It is not like that. One day you plan and everyone should keep on following your plan, means it will not happen. On the 10th day, the fresh plan, this is realistic. Realistically, that is the way it will happen. That is the reason for people who know DIRA test know this. For people who get DIRA test, you will be making a plan not for the entire 45 days. You make a plan for 1 week. I have trust issues. I don't know whether you'll follow for this week itself. You first follow for this week and you come to the mentor call and you tell me, yes ma'am, I followed for this week. Then I will trust you more. I will give you for next 2 weeks plan. We will make it together. And then you follow for next 2 weeks. And then you come to the mentor call. Mentor call anyway happens every single day, 4 to 5 p.m. So I have fixed that timing and I am saying you please come to the mentor call whenever you want, or in that 7 days also, if you have any issues, you can come to the mentor call. You know at this time this person is available. So that is how we built that system itself in DIRA test, yes or no? So why we have done that? Because I know that if I leave the planning to you, it might not be that effective. We will do it together. I'm not saying I will also do. It will not be effective. Only if I do the plan, you follow this plan, it will not be 100% effective. It has to be a collaborative effect. You tell me whether you have college, whether you have office, whether you're already doing something else, how much time you will be able to allocate. Do you have any other family commitments? You need to tell me all of those things. And with that available time, we can make a solid plan. And again, after 7 or 8 days, you please come and tell me whether were you able to follow the plan. Definitely no, 100% no one can follow. Maybe 80-90%, that is very good. So with whatever has happened last time, we will follow the similar strategy for the next 2 weeks. You did not follow the plan. What went wrong? Let us first figure that out. Now I have more trust issues with you. Now I'm going to give you only 2 or 3 day plan. You follow that, come back to call. Like that, planning is not a discrete phase, rather it is a continual and iterative process. When does that happen with respect to audit? It begins shortly after completion of previous audit, continues until the completion of current audit engagement. For students' perspective, as soon as the previous exam is over, planning for the next exam will start. Yes or no? Until when will the planning happen? Until the completion of the current exam, the planning is going to happen. Now that result is negative. Then what will happen? As soon as that result comes, planning will start for the next one. Some people, they will go ahead and beyond they will go. When they will be studying for inter only, they will get the thought, for final, whose class to take? Articles, which firm to join? Let us do the research now. What and all firms are there? I will just simply see. Like that, you will start 2 hours, you will waste. Yes. So planning, continuous process, iterative process. Soon after the previous one ends, you are going to start for the current, and until the current one ends, this is going to stay. For audit also same. Soon after the previous audit ends, you are going to start the planning, and this is going to stay until the current audit engagement. Planning includes needs to consider prior to the auditor's identification assessment of risk of material misstatement such matters as prior to auditor's identification and assessment of risk of material misstatement. Now, I love connecting the standards and studying, because that is when you will get a complete picture. Now, I have already connected 315 to 330. There is a connection to 300 to 315. What are they saying? Prior to the auditor's identification and assessment of risk of material misstatement, planning includes the need to consider before itself. That means the first step is what? It is not identifying the misstatement, it is planning is the first step. And after that only you are identifying and assessing the risk of material misstatement. During this stage, before identifying and assessing risk of material misstatement, planning includes the needs to consider all these points. What are the points? What analytical procedures are you going to do with respect to the RAP? Obtaining a general understanding of the legal and regulatory framework which is applicable. What is the materiality level? How much are the experts going to be involved? Performance of other risk assessment procedures. These 5 are what? Planning includes such matters as these 5, and these 5 have to be done prior to auditor's identification and assessment of wrong. What are the 5 points? What kind of analytical procedures? What is the level of materiality? What is the legal and regulatory framework? What level of experts are involved? Performance of other risk assessment procedures. Is that clear? What is RAP? Ayo, that is RAP. Risk assessment procedures are audit procedures performed to obtain an understanding of the entity and its environment, including the internal control, to identify and assess the risk of material misstatement, whether due to fraud or error. Already studied the definition in essay 315. Now coming to planning is not a separate or distinct phase. It is to be viewed as a continual and repetitive process that begins with the completion of previous audit and continues till the completion of current audit. What we studied here, the same thing is given in DAPPA here. Involvement of key team members in planning the audit. The engagement partner and other key members of the engagement team shall be involved in planning the audit. It is not only the partner, it is also the other key members of the engagement team, including planning and participating in the discussion among the engagement team members. The involvement of the engagement partner and other key members of the engagement team in planning the audit draws on their experience and insight, thereby enhancing the effectiveness and efficiency of the planning process. Is that clear? Elements of planning process, I'm going to split that into 2. Preliminary engagement activities and planning activities. For planning activities, we have the overall audit strategy and developing an audit plan. Is that clear? Till here, I want you to be super thorough before we get into the next part. We saw the benefits of planning, who and all it is going to benefit, what areas it is going to benefit, all of those things. Then we went to audit planning and risk assessment procedure. Under audit planning, planning includes the needs to consider even before identifying and assessing the risk of material misstatement, what matters, whether analytical procedures, materiality, experts, other RAP, legal and regulatory framework. What is risk assessment procedure? These are audit procedures performed to understand the entity and its environment, including the internal control, to identify and assess the risk of material misstatement either due to fraud or Error. Planning, is it a separate phase in audit or distinct phase in audit? No, it is a continual process, repetitive process. When does it start? When does it end? It begins with the completion of the previous audit and continues till the completion of the current audit engagement. Is that clear? For the planning stage, who does it? Who does the planning? The engagement partner along with the key team members in the engagement team also. Now comes the elements of planning process diagram. The elements of planning process is split into two: preliminary engagement activities and planning activities. Open your mouth. Planning activity is split into two: overall audit strategy and developing an audit plan. Now we will only focus on the preliminary engagement activities. There are three preliminary engagement activities: performing procedures regarding continuance of client relationship, evaluating compliance with ethical requirements including independence, establishing an understanding of the terms of the engagement. These three have to be done when? Even before you start the audit. You have to find regarding whether you want to continue with the client relationship, performing the procedures regarding continuance of client relationship. It should be ensured that appropriate procedures regarding acceptance and continuance of client relationship have been followed and a conclusion have been reached in this regard, whether you want to start this client or not. That is the first preliminary engagement activity that you will have to do. For that, the firm will be obtaining the information which is considered necessary in the circumstances before accepting an engagement with a new client. When will you do that? Before accepting a new client, when designing whether to continue an existing engagement and when considering acceptance of a new engagement with an existing client. Beautifully, they have drafted this standard, because for an existing engagement, the word you have to use is continue. For a new engagement, the word you have to use is acceptance. You will be accepting a new engagement and you will be continuing an existing engagement. They did not just say proceeding with the client. Specifically, they have told an auditor will be deciding whether he has to continue with the existing engagement or whether he has to accept a new engagement with an existing client. Now, with the same client, I can take up different engagements. That is also possible. Now, read this second sentence. It is very, very important. The firm should obtain information considered necessary in the circumstances before accepting an engagement with a new client. This is one. The second is with respect to existing client, whether it is a continuance of existing engagement with existing client or new engagement with the existing client. They have covered three things here. The first one is talking about accepting any kind of engagement with a new client, because of course with a new client everything is a new engagement. So new client, new engagement. This is the first one. The second one, old client, old engagement. Here they are using the terminology. You just have to continue, whether you have to continue or not, you are seeing. For the old client, any new engagement, if they give, then you have to see whether you have to accept. Are you able to understand? Now, yes, there are 3 points here. 1, 2, and 3. Matters such as integrity of principal owners, competency of engagement team to perform the audit engagement, and implications of matters that have arisen during current and previous audit engagement may need to be considered. 2 things has to be considered, one my side and one your side. We are getting into an agreement. Now I need to have my team members to be competent enough, and I am working with you, so your integrity, your honesty matters for me. These 2 things I am going to see here before I accept a new engagement, before I accept to continue an existing engagement, or before I agree to accept an engagement with a new client in itself. Is that clear? Yes, this is new client. These 2 are old clients. This is new engagement and this is the old engagement with old client. I hope you understood. Clear? If there is a confusion, slowly you will get to the understanding. First you felt like you understood. When I repeated it, there will be some kind of confusion. If you are out of that confusion and again you understood, that means you have understood clearly. Otherwise, you just have to rewind forward a little bit and see it again. Then you will definitely understand. Is that clear? I hope I made sense. Now, the second one is talking about evaluating compliance with ethical requirements, including independence. Independence is for the auditor. Compliance with ethical requirements. The engagement partner shall form a conclusion on compliance with independence requirements that apply to the audit engagement. In doing so, what should the engagement partner do? The engagement partner shall do these three things. Obtain information from the firm to identify and evaluate circumstances that creates any threats to independence. Is there any threat to independence? The auditor has to see. Evaluate information on identified breaches, if any, of the firm's independence policies and procedures to determine whether they create a threat to independence for the audit engagement. Say one person in the engagement audit team, he has having shares in the client company. That is a breach and that is a threat to the independence. Now, what should the engagement partner do? The engagement partner shall take the appropriate action. Am I able to eliminate that threat, or am I able to reduce that threat to an acceptable level? Or if considered appropriate, I will withdraw from the engagement, where withdrawal is permitted by law or regulation. The engagement partner shall promptly report to the firm any inability to resolve the matter in taking appropriate action. Now, here there are 3 points that we saw. First point, we have to see whether there is any threat to the independence or not. The second one, is there a breach to the threat for independence? The third point is talking about, now I am acting on that breach. I am taking appropriate action. How am I taking the action? I am either reducing or eliminating the threat, or I am withdrawing from the engagement. Is that clear? These 3 points are for what? It's for ethical requirements, including independence. The engagement partner will be evaluating the compliance with ethical requirements. Now, this is part of what? Preliminary engagement activities. That you have to be clear. Preliminary engagement activities are 3: performing procedures regarding continuance of client relationship, evaluating compliance with ethical requirements, establishing an understanding of the terms of the engagement. The third point is very, very simple. It is in the interest of both entity and the auditor that the auditor sends an engagement letter, because terms is given where? Terms is given in the EL. So engagement letter has to be given before the commencement of the audit to help avoid misunderstanding. It ensures that there is no confusion with the client regarding terms of the engagement. These 3 are the preliminary engagement activities. The first point is talking about the auditor performing procedures regarding continuance of the client relationship. For that, what and all he has to see? We saw that. Evaluating compliance with ethical requirements, including independence. Here, the engagement partner is more bothered about threats to the independence. The third is whether the terms of the engagement have been agreed upon. Is that clear? Very, very clear. Do you want me to repeat the preliminary engagement activities? Now, in the exam, there is a possibility that they are asking, explain the preliminary engagement activities. There is also a possibility where they are asking, what are the points that the engagement partner should consider when he is forming a conclusion on the compliance with independence requirements that apply to the audit engagement. In that case, you should directly write these 3 points is expected out of you, because now they're talking about the independence requirements. Like this, ICA loves to confuse, because once they use the terminology ethical requirements, your mind will go to ethics chapter itself. But they are asking essay 300 question. You have to know the heading. That is the reason why I have given mind mapping here. Now, what I want you to do under preliminary engagement activities, those 3 points, you please write it here. Please write it here. Don't miss it. I want you to write it in your own hands. That is the reason why I did not write it myself, because it is very, very important. Take that time to write it down in the concept note itself, in the mind mapping itself. What are the 3 preliminary engagement activities? Just put 1, 2, 3, write the headings. Is that clear? Preliminary engagement activities are basically performing procedures regarding continuance of client relationship, evaluating compliance with ethical requirements, including independence, and establishing understanding of the terms of the engagement. Performing the preliminary engagement activities is going to assist the auditor in identifying and evaluating the event or circumstances that may affect auditor's ability to plan and perform the audit engagement. Now, under the planning activities, we have two things. What are the two things? Establishing overall audit strategy and developing an audit plan. Under establishing overall audit strategy, you have 5 points: 1, 2, 3, 4, and 5. And all the 5 points are extremely important because each of the 5 points can be a question in itself, because each of the 5 points are having sub points. And if you actually finish this, entire standard is over, because development of audit plan is very easy. Relationship between audit strategy and audit plan is easy. Documentation is easy. After that, everything is easy. This is the crux. This is the main part, that is overall audit strategy. In establishing the overall audit strategy, the auditor shall consider these factors. What are the factors? Identifying the scope of engagement, ascertaining the reporting objectives of the engagement, consideration of the significant factors in directing the engagement team members' efforts, consider result of preliminary engagement activities. We just did 3 activities, which is respect to preliminary engagement activities, ascertaining the nature, extent, and timing of the resources which is required for the engagement. These 5 points, you need to be thorough with them. Identifying the scope of engagement, ascertain the reporting objectives of the engagement, consideration of the significant factors in determining directing the engagement team's efforts, consider the results of preliminary engagement activities, ascertain the net of resources which is required for the engagement. These 5 points is very, very important. Scope of engagement, reporting objectives, engagement team's efforts, result of preliminary engagement activities, net of resources required for the engagement. Is that clear? Again, all 5. Identify the scope of engagement. Trust me, after all the 5, after we study this, it is going to become a cakewalk for you, but you have to be there till the end. Identify the scope of engagement, ascertain the reporting objectives of the engagement, consideration of significant factors in directing engagement team's efforts, consider the results of preliminary engagement activities, ascertain the net of resources required for the engagement. Is that clear? Very, very clear. These 5 are what? Establishing overall audit strategy. What is preliminary engagement activities? The 3. What are the 3? Procedures regarding continuance of client relationship, compliance with ethical requirements, and the terms. Under that, we saw engagement letter and establishing and understanding the terms. Now we are under overall audit strategy. Now these 5, who can tell? Identify the scope of engagement, ascertain the reporting objectives of the engagement, consideration of significant factors in determining the engagement team's efforts, consider the results of preliminary engagement activities, ascertain the net of resources required for the engagement. These 5 are extremely, extremely important. Is that clear? Yes, very, very clear. Now coming to the first point, that is identifying the characteristics of the engagement that define its scope. It is important for the auditor to identify the scope of the engagement. Only a well-identified scope can lead to establishment of a sound audit strategy. There are many characteristics of engagement that is defining the scope. So now we are going to see what are these characteristics of the engagement that is going to define the scope. Some of the characteristics are as under. Basically, only if we have a broad framework as to what the entity is doing, we will be able to plan for the audit. So we have to know what is the AFRF applicable to the entity, what is the nature of business that we are going to audit, which industry specific reporting requirement is required, and in the previous audit, if there is any audit evidence, whether we can use that audit evidence. These 4 points are the characteristics of the engagement that is going to define the scope of the audit. What are the characteristics of the engagement? Applicable financial reporting framework, nature of business segments, industry specific reporting requirements which is required by the regulators of the industry, and use of audit evidence obtained from the previous audit. So all these 4 are the characteristics of the engagement which is going to determine the scope. And why is it the scope important? It is important for the auditor to identify scope. Only a well identified scope can lead to establishment of sound audit strategy. Is that clear? That is the first one. Identifying the scope of engagement. And here, what did you actually study inside? The characteristics of the engagement, which is going to define the scope. What are the characteristics? The AFRF, what industry it is operating and whether industry regulators are saying something, what business segment it is there, and previous audit evidences. Is that clear? The first one, very, very clear. Good. The second one is ascertaining the reporting objectives of the engagement to plan the timing of the audit and the nature of the communication which is required. Ascertaining of reporting objectives of engagement helps the auditor to plan timing of different audit procedures and also the nature of communication. Some of the instances are as under. Reporting objectives means what? What I have to report, why I have to report, when I have to report. So the first one is entity's timetable for reporting. When you have to report what? Organization of meetings to discuss the nature, extent and timing of audit work with the management. Discussion with management regarding expected type and timing of the reports to be issued, including the auditor's report. Discussion with management regarding expected communication on the status of audit work throughout the engagement. Expected nature and timing of communication among engagement team members, including nature and timing of time meetings and timing of the review of the work performed. Basically here, most of the thing is respect to at what time, what work has to happen. So here when it comes to reporting objectives, the entity's timetable for reporting. How the organization is conducting meetings to discuss the nature, extent and timing of the audit work with the management. Discussion of management with regard to this type of report I'm going to give and this time I'm going to give. And these are the expected communications between both of us throughout the audit engagement. And between the engagement team members also, these type of communication is required and what is the timing of the review of the work which is performed. These 5 are with respect to the reporting objectives of the engagement to plan the timing of audit and nature of communication which is required. The third is consider the factors that in the auditor's professional judgment are important in directing engagement team's effort. So what are the factors they are asking here? What are the factors they are asking here that in auditor's professional judgment it is important for directing the engagement team's efforts? There are only 2 factors here. In fact, here you will see 4 points. But the first point with respect to volume of transactions and the second point is with respect to changes. What changes? Change in industry regulation and new reporting requirements. Change in financial reporting framework. Change in legal environment affecting the entity or any other recent developmental changes. So like I said, I will be considering only these 2 points for the factors it is important for directing engagement team's efforts. Factors that in auditor's professional judgment it is important for directing the engagement team's efforts. Is that clear? Only 2 points. One is volume of transactions, which may determine whether it is more efficient for auditor to rely on internal control. So the volume of transaction is first point. The second point is changes. Under changes, there are 3 other points. What are the 3 other points? Significant industry developments such as changes in industry regulation and new reporting requirements. Significant changes in financial reporting framework. Other significant relevant developments such as changes in the legal environment. Simple. These 2 are for what point? For the factors which are important in directing the engagement team's efforts. Only 2 points. Is that clear? The second one was timetable of reporting and all those things. And the third one is with respect to the factors in directing the engagement team effort. 2 points. Is that clear? Consider the results of preliminary engagement activities. What are the preliminary engagement activities? How many points did we see? 3 points we saw. Very, very good. What are the 3 points for preliminary engagement activities? Regarding continuance of client relationship, ethical requirements including independence and establishing understanding of terms of engagement. Very, very good. Now consider the results of preliminary engagement activities. Now those results, whether the knowledge gained on other engagements performed by the engagement partner for the entity is relevant. Considering the results of preliminary engagement activities and the knowledge gained from similar engagement goes a long way in establishing a sound audit strategy. What are the examples? Results of previous audit that involves evaluating the operating effectiveness of internal control, including the nature of identified deficiency and action taken to address them. The manner in which the auditor emphasizes to engagement team members the need to maintain a questioning mind and to exercise professional skepticism in gathering and evaluating audit evidence. The second point is talking about questioning mind, that is nothing but the professional skepticism. The first point is talking about result of previous audit that involves evaluating of operating effectiveness of the internal control. So these 2 points are for result of preliminary engagement activities and the knowledge gained from other engagements. The fifth is small one, ascertaining the net of resources necessary to perform the engagement. Selection of engagement team and assignment of audit work to team members is a significant factor in establishing overall audit strategy. Experienced team members may be assigned in areas where there is higher risk of material misstatement. Similarly, engagement budgeting and devotion of more time to areas of higher risk of material misstatement are to be kept in mind. The fourth and fifth point is simple. The first 3 points had sub-points. That means in the first 3 points, they can make that itself as a question and they can ask you in the exam. So these 5 are establishing overall audit strategy, and under these 5 there are few points that you have to remember. Identifying the scope of engagement, we spoke about what are the characteristics that is going to define the scope. What are the characteristics? AFRF, business segments, industry requirements, and whatever information you've gotten from previous audit. What is the second point? Here, the scope of audit, reporting objectives. Here, so much about timetable and the review of work and all of those things. Entities, timetable for the nature, extent, timing of audit work with the management, with themselves, with engagement team itself, nature and timing of communication. Expected communications between these two people, expected type and timing of the report that has to be given. All these are for reporting requirements, reporting objectives that has to be seen. Third is factors that is important in directing the team members' efforts. Only 2 points, volume of transaction and changes. The fourth is result of preliminary engagement activities, how we can use here. And the fifth one is nature, extent, and timing of resources which is required to perform the engagement. Now comes development of the audit plan. Once the overall audit strategy has been established, an audit plan can be developed to address the various matters identified in the overall audit strategy. Net of RAP, net of FAP, other audit procedures. Audit plan is more detailed than audit strategy. What is it? Net of RAP, net of FAP, other planned audit procedures. The audit plan is more detailed than audit strategy. Planning for these audit procedures takes place over the course of the audit. Now, audit strategy, overall level, what work, all these things you saw. Now, my favorite part, this is the audit strategy that we did. Yes, how many people, what subjects, overall audit strategy. Now, if I have to make the plan itself, how I have to make the plan? In 45 days, I have to see how many hours of classes. I have to see 3 subjects. Yes or no? Approximately 250 hours of classes I have to see in 45 days. That means 250 hours in 45 days means for 1 day, how many hours I have to see? Please tell me, do the calculation and tell me. Tell me guys, how many hours actually came per day? Did you do the calculation? 5.55555 hours came, yes. 5.5 hours. That means 6 hours approximately. Effectively, if you watch the lectures, effectively for 6 hours in the next 45 days. That is wow lectures, wow lectures. Then you will be done with all the lectures. So after every day's lecture, spend that extra 2 or 3 hours and finish off. 2 hours it is possible. 8 hours effectively you can study. It is definitely possible. Just 45 days of efforts. If you are able to put this, then after that you can do your revision number 1, revision number 2, and you have to write mock test, compulsory mock test. Without writing this, don't go for exam. Now itself I am telling you, Mock test. ICA is not simply giving the mock test. You definitely have to write 2 mock tests. ICA is giving 2 mock tests. That means you have to write the 2 mock tests. Apart from that, if you want to write other tests, you please write the other tests also. Is that very, very clear? Now, definitely, you have to do all of these things. And now coming to the 45 days. For these 45 days, I told you approximately per day you are studying for 6 hours. You're watching the lectures for 6 hours. That means you have to start at this time and stop at this time. Say for example, I want you to start studying at 7 a.m. 7 a.m. you start studying till 2 p.m. you keep for only watching the lectures. How many hours is that? How many hours is that? 7 hours. But out of this 7 hours, I am telling you, effective will be 5.5 to 6 hours. Because obviously you'll be taking breaks for breakfast. You will take break for going to washroom. In that washroom, you will start watching the reels. I'm factoring all of that. I'm saying 7 a.m. to 2 p.m. You watch the lectures uninterrupted way. 2 p.m. you are going to stop watching the lectures. You are going to stop watching the lectures at 2 p.m. and you will take a break at 2 p.m. 2 p.m. to 3 p.m. Say you take a break, you finish your lunch and everything, you come back. 3 p.m. to 7 p.m. If you can just finish off everything, I'm giving you 4 hours to finish off everything. I'm telling you, if you finish your day early, that is by 6:37, you're done with all your work for that day. Post 7 p.m., you can relax. You can do whatever you want, but you have to follow this timetable for 7 a.m. to 2 p.m. and 3 p.m. to 7 p.m. If you follow this properly, then after 7 p.m. you can have dinner, you can watch TV, you can talk to family members, you can talk to friends, you can do all of those things. But if you ask me, the best thing to do after 7 p.m. is just go for walk. Talk to good family members, avoid unnecessary relatives, keep yourself calm, in a calm state of mind. I do not want you to talk to friends only for the reason that sometimes it might be toxic. That is the reason. If it is toxic, no, it is not just that 1 or 2 hours, but the after effects of that toxicity. I don't want you to go to that. That is the reason why I said after 7 p.m. you can be with yourself. You can read another book. Or if you feel, yo, no need books itself, ma'am, you go for walk. That is the best thing you can do for a healthy mind and a healthy body also. Now, we developed a plan according to the overall audit strategy. Yes or no? So, development of audit plan actually takes much more time than developing the audit strategy. Strategy is easy. 3 people, you do this, you do that, you do the other one. What exactly are you going to do in accounts? Are you going to teach the other people how many hours to study, how many hours to teach? Now, if somebody else tells me in self-study, instead of me studying, they have already studied and now they are explaining, it becomes extremely easy. Yes or no? So, all those things we can plan with respect to development of the plan. So development of a plan is an exhaustive process. It is a time consuming process when compared to overall audit strategy. The audit plan is more detailed than the audit strategy. Planning for the audit procedures takes place over the course of the audit. Relationship between audit strategy and audit plan. I already told you one relationship, that is you do the overall audit strategy and this becomes the base for development of the audit plan. Yes or no? In overall audit strategy, if you see, in establishing the overall audit strategy, from there only development of audit plan can happen. Once the overall audit strategy has been established, then the audit plan will be developed. So it is flowing from there because overall audit strategy sets the broad approach, and whereas the audit plan addresses the matters identified in the overall audit strategy. Audit strategy determines scope, timing, direction of audit. Audit plan is how this strategy is going to be implemented. Who has the responsibility for establishing overall audit strategy and who has the responsibility for the planning of the audit? Entire responsibility lies with the auditor and auditor only. Can the planning decision keep on change? Yes, when you are studying, you keep on change your planning. For people who are saying no, It is definitely, yes, the planning decisions can change during the course of the audit. The auditor shall update and change the overall audit strategy and audit plan as necessary when as a result of unexpected events and changes in the condition or audit evidence obtained as a result of audit procedure is going to differ significantly when the auditor planned the audit procedure. When I planned, it was a certain way. Now it has completely changed. Then in that case, I have to change my plan also. Now, what and all should you document? You should document the overall audit strategy. You will be documenting the audit plan, and any changes made to both of these two places, you will be documenting that also. Changes made to overall audit strategy or the audit plan, and what are the reasons for such changes. The documentation of the overall audit strategy is a record of key decisions considered necessary. The documentation of audit plan is a record of the planned nature, extent, and timing of RAP and FAP. A record of significant changes to the overall audit strategy and audit plan, resulting changes to the plan net of audit procedures, explain why the significant changes were made, and overall audit strategy and overall audit plan finally adopted for the audit. They're explaining those three documentation points here. Planning, supervision, and review of the work of engagement team members. Now, inside the audit team, how should the planning supervision be? The auditor should plan the net of direction and supervision of engagement team members in the review. The net of the direction and supervision of engagement team members vary depending on many factors. What are the factors? Size and complexity of the entity, area of the audit, assessed risk of material misstatement, capabilities and competence of engagement team members who are performing the work. Clear? We are done with the first two parts. First three parts, sorry. This part, and this part. I told you audit program is a little separate. It is a separate topic in itself. So quickly let us go through what is an audit program. But before that, I will give you a background as to what happens in a Big Four. Now, my articles, when I went, at that time there was this rule that if you finish, now whatever I'm saying, the story is relevant to audit program. Don't think I'm talking some nonsense story. So be with me. Now, when I did my articles, what happened? What was I going to say, guys? So those days when I did CA, you can do articles as soon as you finish group 1. So as soon as I finished group 1, I joined a small firm. A very small firm I joined. I stayed there for less than 6 months because in the next attempt, once I cleared my group 2, I went to KPMG. See, after the first group results came, I cleared, I went and joined the small firm. I was there for 5 or 6 months, and then when the results came, I immediately went to KPMG. Now, in this KPMG, I stayed there till the end of my audit. So, entire articles is for 2.5 years. I stayed in KPMG for 2 full years. After articles also for little time I stayed, but during the articleship period, I will tell you what happened. So my first client when I went to KPMG was DICV, that is Daimler India Commercial Vehicles. That means Daimler India Commercial Vehicles means it is Mercedes-Benz. Mercedes-Benz parent company is called Daimler AG. It is a German company. Daimler India Commercial Vehicles is for Mercedes-Benz or a commercial vehicle segment. Now, in DICV, that was my first client and also one of the biggest clients for my team. I am a first year article. I only have theoretical knowledge, and since it's a transfer pricing engagement, that also I don't have. Do we actually study transfer pricing? Not much, right? So I really don't have any practical exposure, and it's my first engagement. But I aced the engagement. I really aced the engagement only for one reason, because I followed the audit program which was given to me. Now, what happens in the audit program? Now, when the auditor goes for audit, most of the time, what the auditor is doing is asking questions to the management and understanding, asking different questions to different people and trying to understand the process. The questions need to be framed a certain way. The questions need to be asked to the right people at the right time. The questions will tell the other person that you know the subject, yes or no. And questions will always have follow-on questions. Say for example, questions should be like a graph. Say first I ask this question. Now with this question's answer, if it is a yes, I have these three questions. If it is a no, I have these three questions. Now with respect to this answer, I have to ask these three questions with respect to this answer. And with respect to this answer, I come back here because now they're going to say that it is a yes. Like that, it is quite confusing. What KPMG gave me, I tell you, one super document to ask the questions was given to me. Super document to ask the questions was given to me. Now all I have to do was have the questions in my laptop, behave like a senior person, see the question and ask. And based on whatever answer they are giving, I am going to ask the next question and I am documenting whatever answers they are giving. And that is the reason as to how I was able to ace the entire audit because of this tool called as audit program. This audit program is basically a set of examination and verification steps. It is the steps for me to do the audit. With this background in mind, you see what is the meaning of audit program. An audit program is a detailed plan and consists of a series of verification procedures to be applied to the financial statements and accounts of a given company for the purpose is what? To obtain audit evidence, to enable the auditor to express an informed opinion on such statements. For framing an audit program, the following points has to be kept in view. Before I come to framing of the audit program and all of those things, I will finish off advantages and disadvantages so that you will have a better understanding. What are the advantages and disadvantages of an audit program? Coming to advantages of an audit program, it provides the assistant a clear set of instructions. Now, because they were able to tell me all the questions beforehand, I have the confidence that even though it's my first audit, even though it is a huge client, I did it with utmost confidence because I had the clear set of instructions which is to be generally done. It is essential for major audits to provide a total perspective of the work to be performed. For huge audits, it will always be there. There is some issue with the moving. Yeah, now it's fine. You're able to see properly. Okay. For major audits, that is huge audits, definitely audit program is helpful because you get the overall perspective, like how if it is a big standard and if I give you what to expect, that is the mind mapping, it is helping you something similar to that. Selection of the assistants for the job becomes easier when the work is planned, defined and segregated. Now with the number of questions in hand, you have 500 questions in 4 different segments. In 4 segments, you have 500 different questions. One segment has 200 questions. Second segment has 50 questions. Third and fourth segment has how many? Another 200 questions. Fourth segment has 50 questions. Now you know one person can do the second and fourth segment and all the remaining people will help for the first and third segment because the number of questions is high there. Based on that, I am going to select my assistant. Without a written and predetermined program, work is only carried with a mental plan. Because this audit program is in written format, it helps you to identify, okay, all these has to be covered. I will plan for it accordingly. Like that, you can start planning for it. The assistants, by putting their signature on the program, accept the responsibility for the work carried out by them individually, and if necessary, the work may be traced back to the assistant. So basically, like I said, the audit program will be in the computer. It will be in the system. So as soon as I go in the morning, what I'm going to do is I'm going to ask questions to them, and once they answer, I'm going to type it in my computer. In that software itself, I'm going to type it. Now you tell me, in the future, if there is a problem in this particular point that I oversaw something and I did not find the particular mistake that the management is doing. Now the engagement partner can easily track that work back to me, because when he goes into the software, he knows that I only did this work. Why didn't you do it properly? Like that, he will be able to ask me. He can control the progress of the audit, because most of the times I will tell you how I will get caught. I will be on the way to client's office. Now I cannot lie to my partner saying I have already reached. I'll tell you why. Because if I have already reached, I would have started typing in that audit program they have given. I would have put a tick at least. Yes or no, that I have completed this, like that I would have put a tick. Live, my partner can see as to what I am working on. It is like a shared sheet because it is a software. Yes or no, the audit program nowadays for huge audits, it is given like a software. So it is easy for him to control the progress and to track back the work to me in case if there is any issue. Usually this audit program, you know how they will do? They will take the previous year audit program. They will have a discussion with the client as to what has changed from the previous year. If nothing has changed, now I'm going to do the same set of questions. If something has changed, then I will be saying where is the change and how should I change the question also. So the previous audit program is going to serve as a guide for the current year, and whatever I'm doing right now, that will serve as a guide for my juniors. Yes or no? So this serves as a guide for audits to be carried out in the succeeding year. A properly drawn audit program serves as an evidence in the event of any charge of negligence being brought against the auditor. Saying if somebody says, hey, you did not see that point, that is the reason why you have given a clean report. Hello, see my assistant. I can see at what date, what time she saw this point. It acts as a document for the auditor also, evidence for the auditor also. If there is any negligence brought against the auditor, in that case, this is my proof. See my audit program, I have done all the work, like that he can show the other person. So what are the advantages of audit program? It provides a clear set of instructions. It is essential for major audits to provide total perspective of the work. Selection of assistant for the job becomes easy. Without a written audit program, everything happens mentally. The assistant, when they're putting the signature, they are accepting the responsibility. The principal is able to control the progress. This serves as a guide for future audit, and this also serves as an evidence if there is any charge of negligence against the auditor himself. If there are advantages, there will definitely be disadvantages also. Now say for example, it's my first year, so I took shelter under it. Say the entire 2 years that I'm with them, I'm always only following the audit program without understanding the intention behind the audit program. Then how is that? How is that? It is not going to be helpful for them or for me, because if I am an inefficient assistant, this program is helping me to hide behind it. Because even if I'm inefficient, this program is helping me by giving me the questions, and no one will know that I'm inefficient. So inefficient assistant may take shelter behind the program. Now, because I'm following the audit program, I will only think like this. Questions are given to me like this. I will not have a broader perspective. Work may become mechanical. People may just do the program without understanding the intention behind asking the question. The program will make you rigid, make you inflexible. And if you are actually efficient and enterprising assistant, you will not like to just look at the question and ask them at all. So audit program has advantages and it has disadvantages. How are you going to eliminate the disadvantage? Now, if somebody is just following without understanding, I will have supervisor who is going to tell me. Supervision of the work carried out by the assistant. Auditor must have a receptive attitude as regards the assistant. Assistant should be encouraged to observe the matters objectively. You don't just follow the question. Have objectivity also and bring significant matters to the notice of supervisor or the principal. Now, where is the actual work with respect to audit program? Everyone is following the previous year work, current year work for next year. Like this, it keeps on going. Where is the creativity? The creativity is actually for the person who is doing the audit program. For the person who is doing the audit program, he is constructing the audit program. For the construction of the audit program, the following points should be kept in mind. Stay within the scope of the engagement, within the limitation of the engagement. Always an audit program has to be in written format. Determine the evidence reasonably avoidable and identify the best evidence. Apply only the steps which are useful in accomplishing the verification procedure. Include the audit objectives for each area. Consider all possibilities of error and coordinate the procedures to be applied to the related items also. So for construction, these points have to be kept in mind. The auditor picks up the evidence from a variety of field and it is generally of the broad types. What kinds of evidence will he consider? Documentary evidence, physical examination, any statement or explanation from management or other employees, or any statement or explanation from third parties also, arithmetical calculation, internal control, interrelationship between data, subsidiary accounts, minutes of the meeting, or any action which is taken by the client or others. All these are the evidence that the auditor is going to consider. Determine the evidence reasonably available or identify the best evidence. What kind of evidence is? That is all of this. Now comes audit objective, audit procedure to be applied, what extent of check, is there any special experience based on past experience, special instruction based on past experience, allocation of work among the engagement team members, and what is the timing of check. These are the points which you have to remember for doing the audit program. Evaluating one audit program not practicable for all businesses. Obviously, each business is different, so each business will have a separate audit program. The assistant, whoever is working, they must have an open mind. Auditor will be framing a standard program based on nature, size, composition, internal control, all of those things. These program must ensure minimum essential work is covered. With experience, the program can keep modifying, add omitted but relevant work, drop irrelevant work. Assistant must keep an open mind. Assistant should note and report significant matters. How will the periodic review happen? It will happen. The audit program must be reviewed periodically for adequacy purposes. Without review, changes in client policy may go unnoticed. Reliance on obsolete program may make audit negligent, that is, legal consequences will be there. Review the retained utility by removing inadequacies or redundancies, that means duplicacies. Audit program not only lists the tasks to be carried out but also contains few relevant instructions. Assistant must follow program until officially changed. Rigidity is only apparent. Periodic review keeps it flexible. Assistant's observation keep program up to date. So this is basically telling you how an audit program must be framed. A periodic review must happen. How the assistant's state of mind should be for the audit program to succeed. You have understood what is an audit program. Then we went to advantages, disadvantages of audit program. Then the practical difficulty of making the audit program. How are you going to make the audit program? Can you make one audit program for all types of businesses? How should the assistant be? How are you going to review the program? All these points has to be kept in your mind. This is how an audit program will look. This is the template. Every audit program will have name of the concern, whatever. What is the financial year? Prepared by whom, reviewed by whom, approved by whom, with the date you will have to give. And what is the nature of procedures? The question, vouch, few, sales, invoice. The instruction is given here. What is the extent of check? Are you doing all the sample or sampling basis only? What is the basis of the sample? Random number table list. It is done by whom? CA, CPA, Nivedha, Shankar, my signature. Like this, it will keep on going. Now, there was one RTP or even previous exam question where they asked for a sample audit program pertaining to sales is given, correct? There is a possibility that they can ask pertaining to purchases also, or pertaining to inventory, or pertaining to trade receivable, trade payable, anything. Now, when they ask about sales, you will be writing these points. When they ask about purchases, you can just write vouch the purchase invoice, trace the invoice, verify few invoice. For e-Waybill portal, trace few invoices into the stock records. That also e-Waybill, you'll have to check whether it is there. Trace few purchase invoice in account of sellers. Like that, you will change little bit and you will be able to do it. For inventory, you will have to know what you will be checking in inventory. For that only, we have a separate chapter called as items of FS. Why ICAI loves this is a combination question between SA 300 audit program and items of affairs. That is the reason why they have asked this in the past, and it is also a RTP question. So this is how a sample audit program will look, guys. Is essay 300 actually easy? I understand when compared to other standards, it might be a little more information, but essay 300 for the 10 marks, is it worthy? Is it easy? You have to study word by word this standard, have full grip in this standard. If possible, watch the entire essay 300 again. No issues, no harm at all. 1 hour you can spend again for the entire essay 300 to get that full grip. No problem, but get that grip and then proceed to the standard. Here we started off with benefits, wrap, audit planning. Then we went to elements, preliminary engagement activities, 3 points. Then overall audit strategy, 5 points. Development of audit plan. Then audit strategy and audit plan, how is it interrelated? Documentation we saw. Planning, supervision. Then we went to concept of audit program. One small point I have left with respect to the resources. I thought I will come later. Establishing overall audit strategy. The process of the overall audit strategy assists the auditor in determining about the resources. Resources for what? The resources to deploy for specific audit areas, such as which team member you should use, the amount of resources to allocate to specific audit areas, such as number of team members assigned to observe inventory count at material location, extent of review and all those things. When these resources are to be deployed, whether at interim stage or cutoff date, how the resources are managed, directed, supervised. So about resources they can ask, but the question how they will be framing is how the process of establishing overall audit strategy assists the auditor in determining, subject to the completion of auditor's risk assessment procedures. Then we will have to write this answer with respect to how it is going to help them with respect to managing the resources. Like that, if you write, you're not going to get the marks. You have to write all the 4 points which is talking about resources. Since this was missed out, I wanted to cover that also when we did the mind mapping. Again, I remember that this specific one was missed out. Yes, guys, and that's it with essay 300. Like I said, if you want better clarity, go through entire essay 300 again. Not wrong at all. Is that clear, guys? Yes. Give me a thumbs up if you understood essay 300. 10 marks if you feel like, sorry, not 100 marks, 10 marks if you feel like you have put it in your pocket. You please give me a thumbs up, guys. Yes. All right, guys. Enjoy the subject, guys. And that's it. Essay 300 has come to an end. Now I'm going to start off with essay 450, that is evaluation of misstatements which is identified during the audit. Do not forget the name and number of the standard. Essay 450 is evaluation of misstatements identified during the audit. So basically when you're doing the audit, of course, you're going to find fraud or error. This is called as mistake, yes or no? The mistake in technical terms, in auditing terms, we will be calling that as misstatement. Whenever you find a mistake, you will have to see whether this mistake is material or not. Now, as an auditor, we will be evaluating how big or small this mistake is when we are identifying during the audit. Before we get into the standard, you can see the mind mapping as to how small it is. You will be seeing the objective of the standard, for what reason this standard is actually there, what is called as accumulation of misstatements, consideration of identified misstatements. What should the auditor do when he has identified the misstatements? He has to communicate to those charged with governance. How should the communication happen and how should the correction happen of that misstatement? Now, if they have not corrected, it is still standing as uncorrected misstatement. Now we have to see the effect of this uncorrected misstatements on the financial statements as a whole. How will you communicate to TCWG? Said in 260, a small reference there. And then there is written representation here as well. So there is a reference to SA 580 also. And finally, there are a few disclosures that you have to do. Starting off with the standard objective of the auditor. The objective of the auditor is going to be to see that the misstatements, whatever that the auditor is identifying, how effective it is on the audit. That is how it is going to affect the audit itself. The effect of identified misstatement on the audit. Say for example, you are having a boyfriend. CA students, very difficult, I understand, but still you are having a boyfriend. Now what is the non-negotiable for you? That means if he does this activity, I am going to break up with him. Like that you will have something. If he does this mistake, I cannot tolerate it. Like that you will, texting the ex. Boyfriend is texting his ex-girlfriend. Yes? Am I right? Your boyfriend is texting his girlfriend. Okay. So texting his ex-girlfriend. Okay. So if the effect of identified misstatement on the audit, now you have identified this mistake. Now what you will do? You will do crying, you will do scolding, you will torture yourself, you will torture him. All of those things you will do. Similarly, when you go for audit, when you find a mistake, what effect is it going to happen on your audit itself? Are you going to do more audit procedures? How are you going to communicate? Or this itself is more than sufficient reason for you to modify your opinion itself? Yes. Now, whenever you find a mistake, say for example, he is texting his ex-girlfriend, you have found this out. Now, what should you do at this point in time? You will be asking him, why you are doing like this? Ask for reasons first. Now, if he says, no, she's just a friend. If you want, you also read the messages. What is there in this? Like this, if he is saying, then you will be like, still I'm not comfortable. I am still not comfortable. You please don't talk to her from here on. From henceforth, you don't talk to her. Then he is saying, okay, promise I will not talk to her from now. You have to be comfortable. That is most important for me. Like that, if he is talking. Now he has corrected the misstatement. Now we girls are all sweet and we will be like, okay, fine, he has corrected. So no issues. So if it is an uncorrected misstatement, then what is the effect of that? If he is saying, no, I cannot do what you are saying. I will do as per my wish only. I will text her. I will text my ex-girlfriend. Nowadays people have lots. Correct? The list is very long. So they will say, I will text her. I will text her also. What is your problem? Like that if he is asking. Now it is an uncorrected misstatement. Now you have to take a decision whether you have to stay with this person or whether you have to take a decision to move out. So what is the effect of the uncorrected misstatement on the financial statements as a whole? Now, what I want you to note here is when you identify a misstatement, you as an auditor, you are going to see what you have to do to the audit. So, effect of identified misstatement on the audit, you will be seeing. Now, once you see a misstatement, you're asking the TCWG to correct down. They are not correcting. What is this uncorrected misstatement? How is it going to affect the financial statements? How big is it in the financial statements? On the financial statements, you will be seeing for the effect of uncorrected misstatements. I hope you are able to see the difference between the two. So, the objective of the auditor is basically to evaluate the effect of identified misstatement on the audit and the effect of uncorrected misstatements on the financial statements. Now, accumulation of misstatements identified during audit. I always talk about this. 5 paise if you steal, is it wrong? It is not wrong. But if 5 crore people 50 times, if they steal 5 paises, then it becomes a huge number. So even if a misstatement is small, when it gets accumulated, then it looks like a big misstatement. So auditor is going to accumulate the misstatement other than that is clearly trivial. What is the meaning of trivial? Trivial is very small. If it is too small, you leave that out. Otherwise, you have to accumulate the misstatement. A misstatement can arise from so many factors. Examples of misstatement is what they have given here. Inaccuracy in gathering or processing the data. What is inaccuracy in gathering or processing data? See, there are two different things. Inaccuracy in processing data and processing the inaccurate data. There are two things here. What is the difference between the two? Inaccuracy in processing data, processing inaccurate data. Processing inaccurate data means the data is wrong and the process is correct, but still the output is going to be wrong because you are processing a wrong data, inaccurate data. Here what is happening? Inaccurate processing of the data is correct, but inaccuracy is with respect to the process of that data. For example, I am putting rent account debit to bank account, what is supposed to happen? To the P&L, rent account is supposed to come, and in the balance sheet, the bank account is supposed to reduce because I've given a credit to bank. Yes or no? Now, when the system process, nowadays you just have to enter the journal entry and the final output is automatically given by the system. Now, when the system is processing this transaction, the rent account debit in the profit and loss, rent account is not at all seen. In the bank account, it is reduced. What happens? The system is making a mistake like you all. Now, balance sheet itself is not going to tally, yes or no. Whatever said and done here also, the output is going to be wrong only. So, inaccurate processing of the data or processing inaccurate data. Here they're talking about inaccuracy in the processing of the data as a misstatement. But the other one is also a misstatement only. Omission of an amount or disclosure. Omission is also a misstatement. Some people will be like, I will not tell mistake. I will not tell whatever is false. I will not lie. But I will hide the truth. Hiding the truth is equal to a lie only, man. Hiding the truth is equal to false, yes or no? Like that, omission is also a misstatement. Entity wrongly capitalized an expense, overstating the profits. It's supposed to be expended, but they have capitalized it. What is going to happen? Is it going to overstate or understate the profit? Why they are saying overstating the profit? Wrongly capitalized instead of expenses. It is supposed to be rental expense, or say it is supposed to be repair expense of 1 lakh rupees. That means your profit is supposed to be reduced by 1 lakh. With whatever amount is there, it is supposed to be reduced by 1 lakh. On the other hand, in the rental expense of 1 lakh, if you added it to your asset in your balance sheet asset side, whatever value is there, you have added 1 lakh to your asset value. Now what happens to your profit? This figure is not at all there. So this profit figure is going to be inflated by 1 lakh. That is the reason why they said an expense, if it is wrongly capitalized, that means an expense is not there, you're going to overstate your profit. That also is a misstatement. Mistakes can be so many. Just 3 examples have been given here. This is not an exhaustive list, it is an inclusive list. And inaccuracy in processing data, omission, and entity wrongly capitalized an expense which is going to overstate the profits. Consideration of identified misstatement as the audit progresses. What is going to happen? The auditor shall determine whether audit strategy or audit plan needs to be revised. Now, what is this audit strategy or audit plan? In detail, you will be studying in essay 300. But for now, you can just understand this as, once I find a misstatement, whatever plan I had before, I might change that plan. I might change that strategy. If I have to tell in your language, if you have a boyfriend and if you find him talking to his ex-girlfriend every single day, no, every single night, he's talking to his ex-girlfriend, and you find that out. Now, what are you going to do? You made a plan previously that you were going to marry this person, you're going to have kids with this person. You made that plan. Now, because you found this misstatement, you're going to change that plan. Or are you going to be that stupid who will still go and marry him? Definitely, you're going to think about changing your plan. Oh, I thought about all of these things, but this person is not the person that I actually had in my head. Like that, you're going to see, once you see a mistake, you will change your plan itself. Same way in audit also, once you see a misstatement as the audit progresses, you will determine whether an audit plan has to be changed, whether audit strategy has to be changed. Now, when will that audit strategy and audit plan be changed? When the nature of identified misstatement and the circumstances of their occurrence indicate that other misstatement may exist, that when aggregated with misstatements accumulated during the audit could be material. Now, you found one mistake that he is talking to one girlfriend, one ex-girlfriend. Now, this misstatement is opening up so many other things, because a person like this could have been talking to another girlfriend also. Now, you found out that he is talking to 2 ex-girlfriends. Now, a person like this might be messaging all random girls on Instagram. Yes or no? That is wrong. A person like this might be a stalker also. Yes. Now, one misstatement is telling you that multiple mistakes that this person might be doing. Similarly, in audit, you finding one misstatement will tell you whether there are multiple other misstatements also. Say, for example, there is a processing mistake. The same thing what we saw here, a repair expense. It has been gone to the asset. Now, because the computer has done this, there is a processing mistake. Will you have a doubt that there is some other expense also where it has been capitalized and it has not been shown in the profit and loss? You will definitely have the doubt because the computer has made the mistake. How will the computer make only one mistake? It is possible that the computer has made multiple mistakes. I have found one. You will get that doubt. So, one mistake is indicating that other mistakes are also may exist. The aggregate of misstatements, when you accumulate everything, then it becomes material. So obviously, if it becomes material, you will have to see whether your audit strategy or audit plan needs a revision. The auditor may request management to examine class of transaction ABCD in order for management to understand the cause of a misstatement identified by the auditor. Then he will perform the procedure to determine actual amount of the material misstatement in the ABCD and to make appropriate adjustments to the financial statements. Such a request may be made, for example, based on auditor's projection of the material misstatement. If at the auditor's request, management has examined the account balance, class of transaction or disclosure and corrected the material misstatement, whatever was detected, then the auditor will be performing additional audit procedures to see if this misstatement is still there. Now, if your boyfriend is saying, yes, I will correct my mistake, whatever you feel is the most important for me, like that, if he says, you will still have a doubt whether he is really talking, simply whether he is convincing me and going that side and talking, you will still have the doubt. So again, you will go and check. Again, you will ask him. Checking the phone is actually not a good habit, guys. Don't check other people's phone. It is unnecessary tension for that. If you want to protect your peace of mind, it is best not to check the other person's phone. It is none of our business. You can ask him. If you're doubtful, you can ask him. See, when you check a person's phone, it is not only you that is getting affected. The other person, if he comes to know that you have checked it, he will also get affected. Yes or no? If he is really a good person, he will also get affected. So the best thing is, if that other person doesn't have a problem, then he himself is going to give the password to you. You can check whatever you want. But still, that is not necessary. If you have a doubt, you can ask the other person, did it happen like that? Like that, you can do additional audit procedures to see if that misstatement actually still remains. Is that clear? Now, consideration of identified misstatement as the audit progresses. We saw here that one misstatement is going to tell you that there are multiple other misstatements, and when you aggregate small misstatements together, then it becomes a big mistake. That means SA 320 materiality concepts come into the picture. Now, whenever you find a ABCD and you ask the management to correct the misstatement, then whether they have corrected the misstatement, you will have to be doing a additional audit procedure to see whether the material misstatement still remains. Now, I'm going to the fourth Roman number, that is the communication and correction of misstatement. When should you communicate? Now, say for example, some people will be like this. I saw him make a mistake. I will keep it to myself. Now I saw him make another mistake. Again, blood is boiling, but still I'm keeping it to myself. I saw 10 mistakes. 11th mistake. Now the cooker is going to explode like anything. Now when I'm exploding, all the 10 mistakes are going to come out. Is that a good way of communication? No. The communication must happen then and there. You found something which made you uncomfortable. Let the other person know. See, boss, this is not what I expected out of you. This made me a little uncomfortable. Tell that to the other person. Second mistake, you find it. See here, I already told you that day also. Now again, I'm looking at this. It is not making me comfortable. Like this, if you're going to communicate to the other person, then most of the problems will be sorted in life. Yes or no? So like that, when you go for audit, you have to communicate, not at the end of the audit. On a timely basis, you will be communicating to the appropriate levels of management unless it is prohibited by law or regulation. Now the auditor, when he is communicating, he will request the management to correct the misstatements. Now as soon as you may see a misstatement, you are not going to use the weapon, change the opinion, modify the opinion, not going to do all of those things. You will request the management to correct the misstatement. When you do this timely communication, that is when it enables the management to evaluate whether the items are actually misstatements, and then you will be informing the auditor if it disagrees and take actions as necessary. The correction by management of all the misstatement, including those communicated by auditor, enables the management to maintain accurate accounting books and records and reduces the risk of ROM of future financial statements because of cumulative effects. So whatever the auditor is saying, that is for good only. Like that, if the management says things and if the management is going to correct, then whatever accounting books that they are going to have, that is going to have a accurate picture as to what has happened. Now, say for example, nobody likes to be pointed out their mistake. Now, if you point out a mistake to someone and that other person is saying, hey, this is none of my business, you get out of my office, like that the other person is saying. If the management refuses to correct a misstatement, then what should the auditor do? Hey, how can you talk like that? Now see what I'm doing. I will show by modifying the opinion. You can't do all of those things. You are auditor. You are a dignified person. You should ask for reasons for not making the correction and shall take that understanding into account. Now, after asking for reasons, what happens? I will come to that a little later. Evaluating the effect of uncorrected misstatements. If there is an uncorrected misstatement, you went and told him he is not correcting, what is the effect of the uncorrected misstatement on the financial statements as a whole? Till here, we saw that the auditor has to communicate to the management at a timely basis. Now, when you communicate to the management, there will be multiple levels of the management. You have to go to the appropriate level unless it is prohibited by law or regulation. The auditor will be requesting to correct the misstatements. Now, if the management is correcting the misstatements, it is good for the management because they are going to have the accurate accounting books and records, which is going to reduce the risk of material misstatement even for the future financial statements. But in the case where management refuses to correct the misstatement, the standard is saying what? The auditor will obtain reasons for not making the corrections and then shall take that understanding into account while the auditor is evaluating whether the financial statements are free from material misstatement. Now, if they have not corrected the misstatement, what is the effect of uncorrected misstatement on the financial statement? Now the auditor will be determining whether any uncorrected misstatements, whether they are important, whether they are materially, either individually you will be seeing or put together in aggregate also you will be seeing whether they are important. In making this determination, the auditor will be considering the size of the misstatement, the nature of the misstatements, or both in relation to ABCD. The effect of uncorrected misstatement relating to prior periods on the relevant ABCD. Now, what they are saying, you will be seeing the size of the misstatement or nature of the misstatement or both with respect to ABCD, and in the prior period, if there is any misstatement and they have not corrected it, say for example, in the previous year, there was some misstatement. Now, this misstatement was material in that previous year. Based on that, the opinion was modified. Say there was an adverse opinion. Now, in the current year, the auditor is bothered whether the previous year misstatement is carried forward to the current year or not. For that, he will be seeing whether the prior period material misstatement has been rectified. If it has not been rectified, the auditor is bothered to see what is the effect on account balance, class of transaction, and disclosure of the current year. The effect of the uncorrected misstatement, which is relating to the previous year, the prior period, on the relevant class of transaction, account balance, and disclosure, and the financial statement as a whole. I am going to see the effect of the previous misstatement on the current year financial statement. For that only, I gave you this whole scenario. Now, when the auditor wants to evaluate the effect of uncorrected misstatement, the auditor will basically be seeing whether that uncorrected misstatement is important, whether it is material. That materiality concept will be tested at an individual basis and also at an aggregating basis. In making this determination, the auditor is going to consider the size and nature of the misstatement and the prior period misstatement also. The next one is talking about the communication with TCWG, SA 260 reference communication to TCWG. The auditor shall communicate with TCWG regarding uncorrected misstatement and the effect that they individually or in aggregate may have an opinion in the audit report unless prohibited by law or regulation. The auditor shall request that the material misstatement be corrected. The auditor shall also communicate with TCWG effect of uncorrected material misstatement relating to prior period on the relevant ABC. Now again and again what they are saying, current year material misstatement, whatever is there, you please correct. Prior period material misstatement, whatever is there, what is the effect on the current year? So basically the communication happens like this. Now, auditor examines the ABCD and understands the cause of the misstatement. Auditor understands the cause of misstatement and asks the management to correct. The management corrected the misstatement. If the management corrected the misstatement, will the auditor say, okay, tata bye bye? No, the auditor will be doing additional audit procedures to check if material misstatement still exists. This is if they correct. Now, on the other hand, if the management refuses to correct, if the management refuses to correct, what is the standard saying that the auditor should do? The auditor should obtain reasons as to why you have not corrected and then check, evaluate if the financial statements are free from material misstatement. That is all that the standard is saying with respect to SA 450. You have found a misstatement, you have said that it is material, you will be communicating with those charged with governance. Auditor understands the cause of the misstatement and communicates. If the management corrects, then the auditor is going to do additional audit procedure to see if the misstatement still exists. If the management refuses to correct, then the auditor will obtain reasons to evaluate whether the financial statements are free from material misstatement. Here also, when the auditor is identifying a misstatement, the identification of the misstatement could be pertaining to the current period, or it could be an uncorrected misstatement from the prior period. Now the auditor has to evaluate the effect of it on the current period ABCD and the financial statement as a whole. Is that clear? Very, very clear. Once I gave you this whole picture, the same thing is what Roman number 6, Roman number 5 and Roman number 4 is talking about, the communication. And if they correct, if they refuse to correct, how are you evaluating? By way of materiality. For that, what are you going to consider? The size and nature of misstatement and the prior period. Now, how are you going to communicate with TCWG? You're going to communicate with respect to current period, and you're also going to communicate with any misstatement with respect to prior period, which is going to have an effect on ABCD and financial statement as a whole. Clear 4, 5, 6. Now I'm moving on to the 7th Roman number, that is written representation. A written statement by the management to the auditor must be given. What is the meaning of written representation? Written representation SA 580 means it is a written statement given by the management to the auditor, either to confirm certain matters or to support or audit evidence. Very good if you are able to say that, either to support an audit evidence or to confirm certain matters. Now here, why is a written representation coming into picture? Now say for example, if there is a misstatement and you are going and telling those charged with governance, they are saying, I am not going to correct this misstatement because it is immaterial for me. I feel that it is immaterial. Now the auditor is little doubtful. Okay, sir, you have a reason as to why you think it is immaterial. Can you please write it down and give it to me for my records? Now that is a written statement by the management to the auditor. That is why SA 580 written representation comes into place. Now, the auditor will request management and appropriate TCWG whether they believe the effect of uncorrected misstatements are immaterial, either individually or in aggregate. A summary of such items will be included in the written representation. Are you able to understand? Now, when the auditor goes and says that you have to correct. Now they have refused to correct. In this case, if they have refused to correct, now the auditor is obtaining the reasons. Now the auditor is evaluating whether the financial statements are free from material misstatement. In this case, the auditor will be like, in this reason, whatever you have told, saying it is immaterial. Now please give me a written representation. For my records, I need the written representation. Written representation is a statement which is given by the management to the auditor. In SA 580, we saw that it is a statement given by the management to the auditor for two things. It could be either to confirm certain matters or it could be to support other audit evidence. Here, yes, it is a written statement to confirm certain matters. It is also to support the audit evidence. So, yes, it is called as written representation as per SA 580. Is that clear? Very, very clear. Now, I'm going to documentation. Documentation, again, I always keep telling documentation and materiality, you will have the doubt. Are they talking about 230 or are they talking about 320? Because in 320 itself, the standard itself is talking about documentation. Here also, if you see documentation regarding misstatement, the standard itself is talking about documentation. With respect to misstatements, that is evaluation of misstatement whenever you're identifying it during the audit, what should the auditor document? The auditor should be documenting any amount below which misstatement will be regarded as clearly trivial. Say for example, I have made up my mind, below 3000 rupees and all, I am not going to waste my time and energy. Above 3000 rupees, I will see whether it is material in aggregate. Above 10,000 rupees, I will see whether it is actually material. Like this, I have set an amount below which misstatement is clearly trivial. That means it is very, 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 very small for the entity. That case, I am not going to do anything. If you feel that way, you please document that. You need proof that you have not seen these amounts. So audit documentation is going to include an amount below which the misstatement is going to be clearly trivial. The misstatements which are accumulated and which has been communicated to the TCWG and which has been corrected, you please document that also as part of your audit documentation. And finally, if there are any uncorrected misstatements, what is the auditor's conclusion as to whether uncorrected misstatements are material and the basis for the conclusion? Now, as an auditor, what do you feel that whatever uncorrected misstatements are there, is it material or immaterial? What do you feel and what is the basis for you to feel that way? You please document that as part of your audit documentation. So you have to document three things: amount below which the misstatement will be clearly small, all the misstatements accumulated, whether they have been corrected or not. If it is uncorrected, what is the auditor's conclusion as to the uncorrected misstatements, whether they are material or not, and what is the basis for the conclusion? These 3 points have to be given for the documentation regarding misstatements. Is that clear? That's it, guys. SA 450. Easy. Very, very easy. Now, after every standard, how are you feeling? Oh, for this did I struggle? For me to study this standard, did I struggle so much? Are you feeling that way? It is a good feeling to have, because now you're feeling that the standard is easy. But trust me, if you do not study today itself, you are going to forget the example. The standard is easy because I'm giving you the boyfriend example, because I'm telling you real life examples like these, and I'm giving you charts. That is the reason why, see here, this example made that concept easy. The boyfriend example made this concept easy. So everywhere I keep giving the examples for you to get the concepts easily from me. Now, today itself, if you do not revise, you might forget the example. That is the reason why I keep saying that day's work, finish the revision on that day itself. Now, in this SA 450, how did we start? What is the objective of the auditor? It is to evaluate effect of identified misstatement on the audit, effect of uncorrected misstatement on the financial statement as a whole. If you see, the entire standard is talking about this only. You're identifying a misstatement, you're seeing the effect of that on the audit, and you're going and communicating to the management. They are not correcting it. What is the effect of that uncorrected misstatements on the financial statements as a whole? Now, accumulation of misstatements identified during the audit. Now, When there are so many misstatements, then the auditor is going to see whether the plan has to be changed. The auditor shall determine whether audit strategy or audit plan needs to be changed. When should audit strategy and audit plan needs to be changed? When you are accumulating the misstatements and seeing that it is extremely important, it is very material, or one misstatement is going to tell you that multiple misstatements may exist. Now, after finding the misstatements, you have to go and communicate to the management at the appropriate level. Now, if they are correcting, it is good for them because they are going to have the accurate accounting books. But if they are refusing, the auditor is obtaining the reasons. The auditor will ask the reasons and evaluate whether financial statements are free from material misstatements. Now, the auditor will be evaluating the effect of uncorrected misstatements. Now, they have refused to correct. You have asked for the reason. Now, the auditor will be seeing whether the uncorrected misstatements are material or not. For that, the auditor is going to consider two things. One is the size and nature of the misstatement or both. The second is whatever uncorrected misstatement is there in the prior period, what is the effect of that in the ABCD and the financial statements of the whole of the current period. Auditor will be evaluating. That is only communication with TCWG SA 260. Two types of communication with respect to current year and the communication with respect to the prior year. Written representation. Now the management is saying that I am not going to correct because I feel it is immaterial. Now the auditor is going to say, okay, you feel it is immaterial, you have a reason, you please write it down, sign it, and you please give it to me. That is reference to written representation. Now, as an auditor, we need audit documentation for our proof. For that, we have three things amount below which we have decided that it is clearly trivial, and all the misstatements which have been accumulated and given to the management and has been corrected, that also we are going to document. And if something is uncorrected, what is the auditor's conclusion and what is the basis of the conclusion on the uncorrected misstatement, that also the documentation has to be done. That's it. Hardly half an hour we spent for essay 450. Yes, guys, now you're feeling it is easy standard. Be with that feeling. Be with that feeling so that it will help for revision and enjoy the subject, guys. That is the most important one. Audit is actually a very interesting subject because in everyday life, you are going and checking the phone. That is auditing. Yes or no? In everyday life, you are asking the questions to your boyfriend. That is auditing. Asking questions means what? Seeking information from knowledgeable person. You are making inquiry. So basically, you're doing auditing in everyday life. Like this, if you're going to study the subject, no, you're going to enjoy the subject like anything. That is the reason why I keep saying audit and strategic management. Both are two beautiful subjects. Actually, if you enjoy and study, you'll start appreciating the subject more and more. Yes, guys, and that's it with essay 450. Now, guys, in ethics, we are done with meaning of ethics, professional ethics, principles of ethics, and what is independence to auditor, what are the threats to independence, and how they have to safeguard the independence also. What is left is only these two parts, that is professional skepticism and principle versus rule-based approach. Directly, I'm jumping into what is professional skepticism. Professional skepticism is basically to have that questioning mind. When you will have that questioning mind, when you know there is some kind of a doubt which is happening. Say, for example, you and your boyfriend, you are going on drive in a bike. Say this is only the bike, you are going on drive. That time, your boyfriend is saying, this is the first time a girl is sitting behind me. Like that, he gave a statement. What is the statement that he gave? This is the first time a girl is sitting behind me in the bike. Like that, he gave. Now they went to Mahabalipuram, Pondicherry, somewhere they went, they came back and all. When they came back, he is telling some story about some other girl who sat and she fell down when she was sitting behind. Something like that he is saying. Now, what is the doubt which is coming in your head? Is he lying to me? Because first he said that this is the first time a girl is sitting, and the next time what he's saying, a girl fell off and all of those things. You are getting the doubt whether he is actually lying to you. Now, when you screwed him and you asked him more questions, he said, did I say girl? I said boy. I said some boy was sitting behind and he fell off. Like that. He is doing the samalchification. In that case, what you are trying to do here is you are trying to know the truth. That is called as professional skepticism, where you are having the questioning mind, because first he is saying something else, later you are finding something else. So you are finding that one audit evidence is contradicting with another audit evidence which is being obtained, then that time you are getting these questions in your head. That is only called as professional skepticism. It is an attitude that includes the questioning mind that is being alert to conditions which may indicate a possible misstatement due to fraud or error. For example, an audit evidence that contradicts with another audit evidence, information that brings into question the reliability of the documents and responses to inquiries, conditions that may indicate possible fraud, and they are not concluding that he is a fraud, possible fraud, circumstances that suggest the need for audit procedures in addition to those that is required by standards on auditing. Now a specific standard will say you do IIO, like that they are saying. Say for example, IIO is analytical procedure, inspection, inquiry and observation. If a specific standard is asking you only IIO, does not mean you will not do reperformance. You will think more than just what the standard is saying. Circumstances suggest that the need for audit procedures in addition to what is required by the standard. Maintaining the professional skepticism throughout the audit is necessary if the auditor is to reduce the risk of overlooking unusual circumstances, overgeneralizing, and using inappropriate assumptions in determining the net of audit procedures. The last part is talking about what is the meaning of principle-based approach and rule-based approach. Principle-based approach is basically just thinking by terms of ethics. Rule-based approach is just thinking as to what is the rule which is given. Now, say for example, same example, boyfriend, girlfriend, we will take. Now, the boyfriend, girlfriend are there. One non-negotiable for the girlfriend is that the boy should not smoke. What is a non-negotiable for the girlfriend? The boy should not smoke. So when the proposal, everything happened itself, girlfriend told, do you smoke? Boyfriend said, no, I don't smoke. Girlfriend said, if you smoke, you tell me now itself, I will not come to you. I will do breakup even before we get together. Like that she spoke. So boyfriend is saying, Amma Satyama, mother promise, father promise, sister promise, everyone promise, I do not smoke. Now both of them got together. Now, after few months, after few years, honeymoon period will come and then go down, then things will become normal. At that time, the boyfriend is smoking something else. You know what it is. Smoking some other green stuff, something he's doing. That time, the girlfriend came and asked, hello, excuse me. You told me you do not smoke, you don't like cigarettes. Then why you are doing all these things? Then boyfriend told, see here, I told you I do not smoke cigarettes. Now this is just eating. I will just eat that green stuff. Now everything has come, correct? I don't know. I'm only hearing in movies and all these things. So I will just eat it. So this is also some kind of drugs only, but they will consume it and there is no smoking involved and all. You said you don't like smoking. I am not breaking your heart. I am following the rule which is put. So what the boyfriend is doing is following a rule-based approach. What the girlfriend is doing is expecting for a principle-based approach. You have to understand the context as to what she is saying and not simply go by the rule. The rule-based approach strictly follows clearly established rule. It may lead to a narrow outlook and spirit of ethics may be overlooked while strictly adhering to the rules. Rule-based approach is somewhat rigid in nature as it may not be possible to deal with every practical situation relying upon the rules. What is principle-based approach? It requires compliance with the spirit of ethics. Understand why the rule was made. Then automatically you'll get the principle-based approach. It requires accountants to exercise professional judgment in every situation based upon their professional knowledge, skill, and expertise. It requires that accountants should use professional judgment to evaluate every situation to arrive at conclusion. Use your judgment to see whether this is as per the rule or not, and don't just go by the rule book. Have that spirit of ethics, that is principle based approach. Is that clear, guys? We started off with ethics, with the meaning of ethics, the moral principles, inculcation of the habit and all of those things. Professional ethics is to protect the interest of the profession, to command the respect. Whether you're doing the practice or service, you have to abide by all the ethical behaviors. What are the principles of professional ethics? That is copy, confidentiality, objectivity, professional behavior, professional competence and due care, and integrity. Then we moved on to independence to auditors. We saw what is independence of mind and what is independence in appearance, just to see whether you're looking independent or not. Both are interlinked concepts. Then we went to threats to independence. I told you the examples here are the most important ones. Under threats to independence, we saw self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Then we went to how to safeguard the independence. If the threat is there, how you will be reducing, or you will be eliminating, or you are going to withdraw from the task itself. Then we went to the concept of professional skepticism, that means questioning mind. And lastly, we saw principle based approach and rule based approach. That's it, guys. With that, ethics is completed topic, guys, that is ethics. But even though this is small, it is very important, because attempt from ethics chapter you get 4 or 5 marks. I have seen question papers even with 8 marks with respect to ethics chapter. So let us not leave this chapter. It is also an interesting chapter, because ethics is something we all have from our childhood. It keeps getting inculcated from our childhood. Before I get into the standard and all of those things, I still want to tell you how important this chapter is, because the name of the subject, auditing and assurance, it was like that previously. They removed that word assurance and they've inserted the word auditing and ethics. The name of the subject itself has this chapter's name, and that is also one of the reasons why ethics is very important. And here, as part of this chapter, we'll be starting off with what is the meaning of ethics. And then you all are in a professional course. CA is not an easy course. It is a highly professional and highly respected course. Now, when you are part of this course, you have to follow these points. That is the professional ethics that ICA will be giving you. What are the fundamental principles of ethics? Few principles are there. And then we go to the concept of independence to auditors. Independence to auditors can happen by way of 2 places: independence in mind and independence in appearance. What is that and all? I will tell you when we are reading. Then comes threats to independence. Then comes how am I going to safeguard that threat. So this whole part is talking about independence. And then this is a separate topic called as professional skepticism. This is a separate topic called as principle based approach and rule based approach. For now, I am only going to focus on the first part, that is meaning, what is professional ethics and what are the principles of ethics. Now, you all tell me, how is a habit actually formed? How is a habit formed, guys? A habit is formed when you do a certain thing for 28 days. 28 days, it's called a mandal. If you do that for 28 days, it automatically becomes your character, it becomes your personality, it becomes a habit. So, when should this be inculcated? Can this be inculcated now, or should it be inculcated when you are a child itself? Ideally, habits should be inculcated when you are a small child. Yes, but can it not be inculcated right now? Yes, of course, it can be inculcated now also, but the struggle is a little more than to inculcate it as a child itself. Now, if you see, I have a very different relationship with food. I used to love food. I still love food, but the relationship and the way I see food right now has changed considerably, because I inculcated this habit that I will not eat post 7 p.m. It was difficult. It was not easy at all. But doing that for a month made that a habit for me. Imagine If this habit has been inculcated when I was a child itself, it would have been easily part of my lifestyle. Now, even now, once in a while, I slip. I eat at 10 p.m., I eat at 2 a.m. Sometimes when you're with friends, then they order food. What can you do? Can you say no to that midnight pizza? It's impossible to say no. Your mind will start playing tricks with you. If not this, why are you even living? Like that, mind will start playing tricks with you. So once in a while you will slip, but a habit is something which should ideally be inculcated as a child. Keeping this in mind, we can move forward to meaning of ethics. The term ethics means moral principles. It is inculcated in the habit, not have any selfish motive. Why IC itself has given this terminology not have any selfish motive? Because always, I will tell you, especially as you are all chartered accountants, to be chartered accountants, when you go for audit, there will be one point in time where your mind will tell you, if I take this money right now, my life is settled. And for that money, you have to act in an unethical way. Will you do that? No, the answer should be no. Whether they give you money, whether they give you kind, whether they give you a house, whether they give you a big house, small house, whatever it is, say no. Learning to say no at the right time to the right people is the most important thing, and that is all that ethics is talking about. You should be able to withstand any selfish motive. You should be able to withstand any temptation. And you should have the clear state of mind to perform with moral principles. Okay, ma'am, you have told what is ethics. What is the meaning of professional ethics? Now, you as a chartered accountant should not be doing certain things. Professional ethics seeks to protect the interest of the profession as a whole. Now, if you do a mistake, hey, ஒரு CA and you as a CA, how can you do this? Like that, people should not talk. So you have the responsibility to protect the interest of the profession as a whole also, and act as a shield that enables us to command respect. You have to command respect. Even a to be chartered accountant, I know in family functions, I know how it is to say I'm studying for CA. That itself commands the respect for you. A chartered accountant, either who is in practice or in service, he has to abide by the ethical behavior. They are expected to follow the fundamental principles. That is the next one. That is the fundamental principles of ethics. How many principles are there? 5 principles are there. How are you going to remember this? You will be remembering copy. Ignore the lines, guys. Like how I ignore all the negativity in my life. Copy. What is this copy? Fundamental principles of professional ethics. C is confidentiality. O is objectivity. P is professional behavior and due care. Another P is professional competence and due care. Sorry, professional behavior and professional competence and due care. I is integrity. Now, starting off with C, confidentiality. Why is confidentiality important? Because a chartered accountant works with a client. He gets to know all the information from that client, but he has to stay silent. Information should not be disclosed to a third party. However, it can be disclosed if it is required by law, because law is the supreme. So if it is required by law, then you disclose it. When it is permitted by law, then you disclose it. Or if it is authorized by the client, or if it is authorized by the employer, or if there is a professional duty or right to disclose and it's not prohibited by law, at that time only you will be disclosing. Otherwise, at all the times, you are going to maintain utmost confidentiality. Is that clear? That is principle number 1 that you are studying. C is confidentiality. O is objectivity. Objectivity means what? There should not be any undue influence. There should not be any bias. There should not be conflict of interest. All these 3 which is given in red are the keywords. That is objectivity. P is professional competence and due care. See, CA is a course which is designed for you to have the utmost competence. Why? Because in any course you take, whether it is engineer or whatever, BCom, BBA, whatever course you take, The course will be where they are teaching you theoretical knowledge. And then you go to your first job. In your first job, they are going to scold you left, right, center. You don't know this also, you don't know that also, like that, they are going to scold you. But there is no chance of that in the CA course. Why? Because here you will be studying only for 2 years. Yes, 9 months and 6 months. And before foundation, 2 months. Yes or no? Hardly 2 years you will be studying. And the similar amount, 2 years, articleship, you will be doing that. So in articleship itself, you are getting all the scoldings. Before you become a CA, you get all the scoldings. You do all the learning, practical learning. You do everything. And once you call yourself a chartered accountant, nobody can question you. Everybody should give you that kind of a respect. That is professional knowledge, professional skill at that level, which is required to ensure that the client receives competent professional service. Whatever current technical, current standards, current relevant laws are there, you have to know that. For that only, ICA also keep on revising the syllabus. Attempt on attempt, there is a revision. In tax, yes, if there is a revision, it's okay. Why other subjects also? Because ICA keeps saying, should there be any one page also changed for them to be a better chartered accountant? They keep on working on the professional competence and due care. That is the P. The next P is professional behavior. You should not do anything that is going to discredit the profession. That means you should not do anything which is going to bring the profession down. It requires a chartered accountant to comply with all the laws and regulation and avoid any conduct which is going to discredit the profession. A professional accountant should not knowingly engage in any employment, in any occupation or activity that impairs or might impair the integrity, objectivity or good repute of the profession. Say for example, he is engaging in illegal activities. What is the world going to say? He is a chartered accountant engaging in illegal activities. That is the words that the world is going to say. You cannot do anything which is going to discredit the profession. The last one, I, is integrity. Integrity means whatever it is there, you talk to the T. Be straightforward. Be honest just to develop your business. Don't tell some nonsense about other people. Integrity implies fair dealing and truthfulness. Be fair to yourself. Be truthful to yourself. I am telling you, half truth is worse than a lie. Be truthful, 100% truthful, and be fair in your dealings. A professional accountant shall not knowingly be associated with reports, returns, communication, or other information where the accountant believes that the information contains a materially false or misleading statement. That is, integrity is about truthfulness, fair dealing, straightforward, honest. Confidentiality is about respecting the confidential information of the third party. Unless required by law or regulation, or unless the client gives the permission, you will not open the mouth. Oh, objectivity is about not having bias, conflict of interest, undue influence. Professional competence in due care, professional behavior. Now integrity also, you know. This is the copy. Independence to auditors, ethics. Independence in mind, independence in appearance. What is this independence in mind, independence in appearance, ma'am? Independence in mind is for yourself. Independence in appearance is for people who are viewing you. Independence in mind means for yourself, you are having a state of mind that nothing is influencing you. You are acting with utmost integrity. You know for yourself. Appearance, you can portray whatever you want, but you know in your head what you are doing. Yes or no? That is independence of mind. What is the meaning of independence in appearance? Simply just to tell to other people, I will show as if I am a very good human being. Like that is independence in appearance. Say in audit terms, what is independence of mind? What is independence of appearance? In audit terms, when I'm going for audit, in my head, if I know I am acting with integrity, I am exercising the proper objectivity, I am having the professional skepticism, I am having the ethics inside me, that is knowing for yourself, having the state of mind. But independence in appearance means somebody who is looking at you is able to say that this person is not good. Somebody who's looking at you is able to say this person is not independent. Say for example, I am going with the client in all public appearances. All public appearances, I'm standing next to the client. And now I am the auditor of that client. What is the public going to think? Everywhere she is roaming around with the client only and she herself is signing the report. Maybe they are friends, maybe they are relatives, maybe something else is happening. Like that, you will start talking. Yes or no? That is independence in appearance. That means the avoidance of facts that is so significant, that are reasonable and informed third party who is having the knowledge of all relevant information will conclude that the member of the assurance team integrity has been compromised. A third party is going to say that your assurance is compromised. In that case, it is independence in appearance has been compromised. Both should be there. You should be independent both the ways. In your mind also, you should be independent. Outside also, you should look independent. There are two interlinked perspectives of independence of auditors. The next comes to threats to independence. Now I'm going to the mind mapping. We finished these three. Then we went to independence to auditors, that is independence in mind and appearance. Now I'm going to threats to independence. Is that clear? Under threats to independence, we have 5 threats: self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. The examples are important. What is a self-interest threat? That means the firm or the partner is going to have some kind of a financial interest in the client. Example, direct financial interest, loan or guarantee to the client, undue dependence on client fees, close business relationship with the client, potential employment with the client, contingent fees for the audit engagement. In all these places, the auditor has a financial interest in the client. This is self-interest threat. Like I said, the examples which is given here are very important because each of the examples can become a separate case study in itself. What is the meaning of self-review threat? Self-review means I myself am doing something. I myself am reviewing the same thing. How can you do that, ma'am? So, for example, I will tell you. Karthik sir is there. He will do cooking. Once in a while, he will do cooking. I also cook once in a while. Don't think I am cooking all other days. We both cook once in a while. We have a person appointed for cooking. Once in a while, he will do cooking. So whenever he is actually a very good cook, he cooks really well. Say weekly once or something, Sunday when he is free, he cooks. So when he is cooking, it will usually be elaborate. Say for example, he has made fried rice, noodles, some Manchurian gravy, and some starter, one soup, elaborate food. You know what he will do? He will plate everything beautifully. See, that's the beauty of cooking once in a while. When you cook every day, it's the same food. You'll keep it in the table and you'll go off. But once in a while, you need to show that you have cooked. So he will first plate the table beautifully. And then there will be place for me to sit, for him to sit. And then we will sit. Before I eat, he will become excited. Super excited. He will hold the hand. Hey, it is very good. No, super. No, did you taste the soup? It is so good. He himself is cooking. He himself is saying it is so good. That is called as, it is self-review. Are you able to understand? Now, see here, self-review threat occurs when during a review of any judgment or conclusion reached in the previous audit or non-audit engagement, or when a member of audit team was previously a director or senior employee of the company. That means what? Previously, be very, very attentive. Previously, in the client company, one person is there who has to prepare and present the financial statements. This person only is preparing and presenting the financial statements. The audit firm, say KPMG, my favorite. Say KPMG is there. This person currently, now this date, he moved to KPMG. Now it is a post-mortem job, correct? Audit is a post-mortem job. Now this person is appointed for this client company. He has to audit the client company. Who prepared and presented the financial statement? Same person. Who is going to audit the financial statements? Same person. In the case where you yourself are auditing your own financial statements, that is called as self-review threat. Now read the text, you will understand. The self-review threat occurs when during a review of conclusion which is reached in the previous audit, or it can be a non-audit engagement, where the member of the audit team, he only was the previous director or he only was the previous senior employee of the client. Member of audit team was previous client. That means he only prepared financial statement. Now he's part of audit team. He only is going to audit. That means that is self-review. Non-audit services include any professional services provided to an entity by an auditor other than audit of review. These include management services, internal audit, investment advisory. You know what is non-audit services. Instances where such threats come into play are when an auditor, having recently been a director or senior officer of the company, when auditors perform services that are themselves subject matters of audit. I hope you understood very, very clearly as to what is the self-review threat. Now I'm going to threat number 3, that is advocacy threat. Advocacy means name itself says the auditor becomes like an advocate for the client. It means auditor promotes or is perceived to promote a client's opinion to the point where people start believing that independence gets compromised. Example, when auditor deals with shares or securities of company or becomes the client's advocate in litigation and third party dispute. Name itself is saying I'm not going to spend too much time on advocacy threat. The next one is familiarity threat. What is the meaning of familiarity threat? You know each other for too long that both of you become so familiar with each other. I'm talking about audit and client, auditee and client. Auditor and auditee. They are together for too long that they become too familiar with each other. So there is a familiarity threat which happens there. They are self-evident and occurs when auditor forms relationships with the client where they end up too sympathetic to the client's interests. Example, close relative of audit team working in senior position of the client company. Former partner of audit firm being a director or senior employee of company. Long association between auditor and client. Acceptance of gift or hospitality. Then that is familiarity threat. Gift and hospitality is familiarity threat. Now this point I have to explain because a former partner of the audit firm being a director or senior employee of the client. That means what? Previously he was part of audit firm. Now he is part of client. That means previously there are so many people in this audit firm. Now out of here, one person has come to the client. Now what will happen when these 3 people are talking to him when they're part of client? Obviously these 4 would have been friends. So there is some kind of a familiarity between them. That is familiarity threat. Now remember the difference between these two. Here previously he was part of the client company. Now he is part of the audit firm. That is self-review threat. This is previously part of audit firm, now part of the client company. That is familiarity threat. Are you able to understand? Very, very clear. Yes, that is the reason why I circle this, because it is similar to this, where an auditor having recently been a director or senior officer of the company. Recently he is a director, now he is part of audit. That time he prepared and presented, now he is going to audit. He himself is going to audit his own financial statement. Self-review threat. In this case, former partner of audit firm, previously is part of audit firm, now he has joined the client. He knows all the people who are part of the audit firm because they are their friends, long association. So it is a familiarity threat. Are you able to understand the difference between self-review and familiarity threat? Now, for this familiarity threat only, they have something called as rotation of auditors, and that rotation of auditors given where? In Companies Act 2013. You already know that. Yes. Then comes intimidation threat. They are keeping a knife. If you don't sign here, I will fussak. Like that, if they say, they are intimidating you. Intimidation threat occurs when auditors are deterred from acting objectively with adequate degree of professional skepticism. When there is a threat of replacement over disagreement, then they are saying that I will reduce the work in response to reduced audit fees. Such threat is intimidating. That is intimidation threat. Here, threats to independence, we saw self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. 5 threats to independence and 5 fundamental principles of professional ethics. How will you safeguard the independence? Safeguards means what? They are basically actions that the accountant is going to take which reduces the threat to the acceptable level. How are you going to do that? For the public to have the confidence in the quality of audit, it is essential that auditor should always be and appear. Always be and appear. That means he has to be independent in mind and also independence in appearance should be there. Before taking any work, the auditor should see, conscientiously consider whether any threats are there. If such threats are there, then he should not take up the work or he should try to eliminate the threat. If the auditor is unable to fully implement credible and adequate safeguards, he must not accept the work itself. Are you able to understand? How is he going to safeguard his independence? Safeguards are basically actions which is going to be taken to reduce the threats to an acceptable level. He should appear independent and he should also be independent, and before taking on any new work, he should see whether there are any threats to independence. If threats exist, then he should either desist from the task. That means he should not accept the task, or you eliminate the threat and then you accept the task. If you are not able to fully eliminate the threat, please do not accept the work itself. Is that clear, guys? That is the safeguards to independence. The 5 independence we saw, threats to independence. What is independence to auditors? It is independence of mind and independence of appearance. Till now, we have completed the meaning, professional ethics, fundamental principles, and independence also. We only have professional skepticism and principle and rule-based approach. Now I'm going to start off with audit of cooperative societies. First of all, can you tell me what is a cooperative society? Examples of cooperative society. Have you seen a cooperative society previously? Yes, guys? Amul. Yes, that is a cooperative society. Co-optex, that is an example of a cooperative society. The Farmers Association, that is also a cooperative society. Why are they actually forming those kinds of cooperative societies? Why cooperative society? Because they have a common cultural need. The farmers are coming for a social need. Yes, the handloom people, they are all coming together and they are forming a cooperative society because handloom is part of a culture. I want to preserve my culture. There is a cultural need, and also for economic benefits to make money. That is also a reason as to why a cooperative society can be formed. It could be for a cultural need or for a social need, or it could be for an economic need. Now, nobody is telling them by law, hey, you all form a cooperative society. You all should come together. You should work for this cause. No one says like that. It is a voluntary organization. A cooperative is an autonomous association of persons united voluntarily. For what? To meet the common economic, social, and cultural needs. For this, they do it through a jointly owned enterprise. A cooperative society, will it be a non-profit organization? That is the main question which is in most of your heads. A cooperative society is a pure business mind only, business organization with a special mode of doing business where they're pulling together all the means of production cooperatively, and they cooperatively want to eliminate the middlemen because the middlemen will usually exploit them, and if there are any outside forces which is exploiting them, they want to eliminate them also. So basically, cooperative society is a voluntary association of people who come together. Say all the farmers, they come together, they form a producer company, they form a cooperative society there, and they think that okay, I myself will go and give it to the end customer. I don't want these middlemen, distributor and all of these people. I myself will have like my own market where I will myself go and give it to the end customer. That is also a cooperative society. Now you understood what is a cooperative society. For the laws governing cooperative society, there is one big law, that is a Cooperative Societies Act 1912. That is a central act. Apart from this, if a cooperative society is acting from more than one state, that means they are acting from 2 or more states, then automatically the Multi-State Cooperative Societies Act 2002 will also become applicable for them. Now, whichever state that they are operating, that state law will also be applicable for them. So, that state cooperative society laws, say for example, AP Cooperative Societies Act, Tamil Nadu Cooperative Societies Act, Maharashtra State Cooperative Society Act, like that, that state's cooperative societies law also becomes applicable because, of course, they are part of that state. So, there are three laws which is governing. One is Cooperative Societies Act. The second is Multi-State Cooperative Societies Act 2002, and the third one is that state's law that cooperative society has to follow. Is that clear? Very, very clear. So one cooperative society will definitely follow two laws minimum, because that state law and Cooperative Societies Act 1912 definitely they have to follow. Only if they're operating in multiple states, then they have to follow the Multi-State Cooperative Societies Act. Very, very clear till here. I am proceeding forward. One of the professional services which is rendered by a chartered accountant. As a CA, what work can I do for cooperative society? Now, for farmers and all, how they will know how to write the accounts? We can help for writing the accounts also. We can help for installation of the accounting system for them. For internal audit, management accounting services and taxation and etc. This is not an inclusive list. It is not an exhaustive list, it is only an inclusive list. So all these services can be done by a chartered accountant for a cooperative society. Is that clear? Powers of cooperative society. Now, the first thing you have to know is normally an auditor does the audit, correct? But here the registrar can do the audit of the cooperative society, or the registrar can ask any person by an order. The order could be a general order or a special order, and he can conduct the audit of the cooperative society. The registrar shall audit or cause to be audited by some person who is authorized by him by a general order or a special order in writing the accounts of every registered society once at least in every year, and this activity has to happen once in a year. The registrar, the collector shall at all times, he will have access to the books, accounts, papers, securities of the society. So here the registrar is having much more powers than the registrar of a company, because the registrar of a cooperative society himself, he can go and conduct the audit, or he will be the one who is appointing any other person by way of an order to do the audit of the cooperative society. And how frequently should the audit be done? Once in a year at least it should be done. Now he can appoint any other person, correct? Now who is that any other person? They did not mention he can appoint a CA. They said any person. Registrar can appoint any person. Who can be that any person? We will have to see that. Now this, apart from a CA, they are also allowing a person who is having a government diploma in the cooperative accounts, and a person who has served as auditor in the cooperative department of the government. These two people also, apart from a CA, can be appointed. So who are the people? This any other person is basically, it can be a CA. It could be a person who's having a government diploma in cooperative accounts, or it could be a person who is an auditor who is in the cooperative department of the government. So all these three people, they can be appointed by whom? By the registrar to conduct the audit of whom? Of the cooperative society. Is that clear? Very, very clear with the qualification of the auditor. Who can do the audit? Registrar can do, or any other person can do. If it is any other person, who are those people who can be appointed? Now coming to appointment. Appointment is done by whom? By the registrar. That means the report will be given to whom? The report will be given to the registrar only. Fees of the auditor will be given by the society, but it will be prescribed by the registrar. Now see here, appointment of the auditor, it will be done by the registrar, and auditor submits the report to the registrar and the society. Audit fees will be paid by the society as per the statutory scale of fees which is prescribed by the registrar. The records, the books and accounts, it is the same, guys. The central government can frame rules to prescribe the books of accounts to be kept by the cooperative society. Normally, the records, books and accounts, same as Companies Act only, but here the state government can say that they have to keep the books of accounts to be kept by the cooperative society itself. Say for example, the Maharashtra Cooperative Society only, they have told that all the sum of money which is received or expended by the society, that means what? Your receipts and expenditure account, and the matters in respect of which all the receipts and expenditure takes place, all the sales and purchases, all the assets and liabilities at the discretion of the society must be presented in a clear and best possible manner, where they are saying it should be kept by the cooperative society. And here the Maharashtra Cooperative Society, they are including one more thing, that all sums of money which is received and expended, that also should be there, and all the sales and purchases and the assets and liability at the discretion of society must be presented in a clear manner, like that Maharashtra state government has told. If that state government has said anything, then you definitely have to follow, because that cooperative society, you have to follow it. The law which is governing, we saw 3: Cooperative Societies Act 1912, Multi-State Cooperative Societies Act 2002, and State Cooperative Society Law, that cooperative society. Is there any restriction on shareholding? If the liability of the member of the society is limited, no member of a society other than registered society can hold such portion exceeding a maximum of 20% or of the value of shareholding to rupees 1000. Auditor will also check if any bylaws are contradicting the state provision. What are they saying? If the liability of the members is limited, yes, definitely the liability of the members will be limited only. That means no member of the society other than the registered society can hold such portion exceeding a maximum of 20%, that means less than 20%, or rupees 1000 only. This is 1912 Act. That's why they are kept 1000 rupees. More than 1000 they cannot hold if the liability of the society is limited. If it is not registered, then always it has to be less than 20% or less than rupees 1000. You should also see the laws that are contradicting the stating provision. That means you also check the state laws. What are the restriction on loans for cooperative society? Basically, the cooperative society can give the loan to all the members of that cooperative society. The cooperative society can also give the loan to another cooperative society, provided this another cooperative society is registered. However, the special sanction is required of the registrar to give the loan to another cooperative society. Is that clear? The restriction of loans is talking about a registered society shall not make a loan to any person other than a member. That means cooperative society to member is allowed. However, with special sanction of registrar, he can make a loan to another registered society. Is that clear? So, cooperative society to member is fine. Cooperative society to another cooperative society, if it is registered, is fine. However, special sanction is required. I'm going to write all of these points so that you do not forget. The first one we saw was appointment will be done by the registrar, and report will be given to the registrar. Fees paid by society as per statutory scale which is set by the registrar. Yes. Now comes restriction on shareholding. What are they saying? If liability of members are limited, then less than 20% or rupees 1000 only they will be able to hold. Restriction on loans. What they're talking about, restriction on loans, a cooperative society can give to another member of cooperative society, and he can also give to another cooperative society. However, that has to be registered, but a special sanction from the registrar has to be given. Is that clear? Very, very clear till here. Now I'm proceeding forward. Is there any restriction on borrowings? You said that you will be able to give the loan only to members, but you can get from anyone. There is no restriction on the deposits that you are actually taking. A registered society can accept loans and deposits from other than members subject to the restrictions bylaws. You please see the bylaws of that society. If that allows, then I don't have any problem. The law is not saying anything. You can take the money from anyone, but you give only to the members. Obviously, cooperative society is formed voluntarily for their own benefit, correct? So they will take money from anyone and they will give the loan only to the members or another registered cooperative society, but a special sanction is required from the registered. Is that clear? Now coming to the investment of funds. Now, for a cooperative society, that society can invest only in few areas. What are those areas? He can invest in central or state cooperative bank. He can invest in the securities under Section 20 of the Indian Trust Act. He can invest in the shares, securities, bonds, debentures of any other society, but that society should have a limited liability. In any other cooperative bank other than central or state cooperative bank, or any other money as permitted by central government or state government, he can invest in all these places. I am also writing this down so that you have the full understanding. Investment of funds, it could be given to central or state cooperative bank. It can be given to securities under the Indian Trust Act. Any shares, securities, bonds or debentures of any other society, but that society should have a limited liability. You can invest in a cooperative bank, and you can invest in any money as permitted by central government or state government. So all these investments can be done by a cooperative society. Appropriation of profits. Now this is important. A prescribed percentage of the profits to be transferred to reserve fund before distributing the dividend or bonus to the members. Before I come to this, let me tell you, you get the profit of cooperative society. Now this profit of cooperative society, you have to subtract the reserve fund, and now you get profit after transfer to the reserve fund. Now 10% of the above, that is the profit after transfer to reserve fund, should be given for charitable persons. 10% of profit after transfer to reserve fund to charitable persons. Now you have profit after reserve fund and profit after transferring to charitable people. Now this reserve fund that you have right here, what is the use of this reserve fund? Where and all can you use the reserve fund? The uses can be for the business of the society itself. That means for the working capital of the society, you can use that reserve fund, or whatever objective that you have. You want to promote the handloom, you want to promote good quality milk, to promote the objective you can use, or any investment as per the provisions you can make. What investment as per the provision? Central or state cooperative bank, securities under Indian Trust Act, shares, securities, bonds, debentures of any other society with limited liability, any money as per central government or state government. So the investments as per the provisions also, you can use what? You can use the reserve fund. Now what is the meaning of charge on profit and appropriation on profit? What is the difference between these two, charge on profit and appropriation on profits? I'll tell you why I asked this question in the first place. If you see here, it is written appropriation of profits, right? a prescribed percentage of the profits to be transferred to reserve fund before distributing dividend or bonus to the members. And then comes contribution to charitable person. They can contribute less than 10% of the net profit after the compulsory transfer to the reserve fund. Then you go to investment of the reserve fund. What are the uses of the reserve fund? And then comes the contribution of education fund. Some state act provides that every society will contribute annually towards the education fund. It is a charge on profits and not an appropriation. Now, for this reason only I asked you, here we saw that it is appropriation of profit, and here we are seeing that it is a charge on profit. What is the meaning of charge and what is the meaning of appropriation? Now, say for example, when I tell that I have to pay the salary of the people, when I say that I have to pay the interest, it means whether or not I have profit, even if profit is not there, I have to make these payments. But in the case where I have to give bonus to employees, this is profit related because I will be giving the bonus as a percentage of my profit only. So here it is based on whether I have a profit, and here it is anyway I have to do this expenditure. I have to expend all of these things. So this is what? This is called a charge on profits, and this is called an appropriation because I am appropriating a certain percentage from the profit to the bonus to employees. Are you able to understand? A charge on profit is basically to tell you the real value of the profit. So you reduce all the mandatory expenses that you have to expend. That is a charge on profit. Now coming back here, what are they saying that it is a charge on profit? Contribution to education fund. Sometimes the state law will tell you that you have to make this contribution. Mandatory for you to make this contribution. That means it is a charge on profit and not an appropriation. Some state acts provide that every society should contribute annually towards the education fund of the state federal society. It is a charge and not an appropriation. Whereas here, if you see a prescribed percentage of the profits, so if profit itself is not there, you will not be making this transfer to reserve fund, right? So only if profit is there, a percentage you are apportioning it for a reserve fund before distributing the dividend or bonus to the members. Are you able to understand what is a charge and what is an appropriation? And now you will be able to understand this flow. From the profit, you make an appropriation towards the reserve fund, and then you get profit after transfer to reserve fund. Less than 10% of the above, you will be mentioning to the charitable persons. Now, this is a charge or an appropriation? It is an appropriation only. And then you get profit after reserves and to charitable people. If the state law asks you for what? For compulsorily that you have to transfer to education fund, then you have to make that transfer also, and this is a charge and not an appropriation. I hope now it is very, very clear with this entire big dabba. Yes guys, moving forward, going to the next dabba. There are a few special features of a cooperative society, cooperative audit. What are the special features? Now, first special feature is with regard to overdue debt. With respect to overdue debt, the classification has to happen like this. If a debt is overdue more than 6 months, you please show that separately. 6 months to 5 years in one place and more than 5 years in one place. The classification for overdue debts has to be this way: 6 months to 5 years and more than 5 years. Whether the overdue debt is affecting the working capital position and viewpoint of the chances of recovery, that also the auditor has to mention. That only is a special feature of a cooperative society. 6 months to 5 years, more than 5 years. What about the overdue interest? Overdue interest should be excluded from interest outstanding on accrued while calculating the profit. Obviously, if an interest is overdue, you cannot show that as outstanding interest, correct? So what you're going to do is interest, add outstanding, add interest accrued, and minus the overdue interest. This is what you are going to do. Is that clear? interest, add your outstanding interest and minus your overdue interest, because it is no more outstanding. You are going to put this as bad or something like that. So overdue interest should be subtracted. Certification of bad debts. The first time you are reading something about certification of bad debts, because Maharashtra state cooperative rules is saying that bad debts can be written off only when they are certified by the auditor. The auditor has to basically certify saying this money will not come to the cooperative society. It is completely bad only. So you please put it as bad debts. Like that, they have to give a certification. And only after that, the bad debts can be written off by the cooperative society itself. Where no such law requires the auditor to certify, then the managing committee has to authorize the write-off. The managing committee of that society will be authorizing the write-off, and only after that you are going to call a debt as a bad debt. In Maharashtra, specifically, they have told who has to certify. The auditor has to certify, saying that this debt is bad. Then only they will show that as a bad debt. If there is no such law in your state like that, you please make your managing committee saying that I am authorizing to write off this bad debt, and that is the reason as to why the society has put this debt as bad. Is that clear? This is one of the special features of a cooperative audit. New feature. Valuation of assets and liabilities. It's the same, guys. If it's a fixed assets, you're going to take the cost minus depreciation, add any cost of acquisition and installation to be capitalized. Normally, this is what you do. For current assets, that is your inventory, you'll be seeing cost or market price, whichever is lower, and all the known liabilities you will be bought into the account, and all the contingent liability you bring it to the notes to account. So with regard to valuation, it is the same as how you will do for a company also. Adherence to cooperative principle. How far the objectives are achieved, the auditor has to see. If it is not in perspective of profits, but in terms of extending the benefits to the members, what are the cost accounting methods? How is the store control methods? Are they following budgetary control, standard costing? All these things should be told by the auditor. Auditor should also point out if there is any infringement with the provisions of the act or rules or the bylaws of that society itself. Financial implication must be addressed and assessed and reported. Members register and passbook. Basically, what you have to do here is, this act is made in Cooperative Societies Act 1912, correct? That is the reason why they're talking about passbook and all. Nowadays, is anybody going to the bank putting entry in passbook? Not really, right? Maybe if we will be doing it for our grandfather will ask us to go to the bank and do the entry. Maybe for that reason we'll be doing it. But in the future, in the next 10 years or so, passbook concept itself will not be there, because we have net banking. All the statements come to us instantly. There is no necessity for you to go to the bank and all and get this done. So members register and passbook has to be examined by the auditor for the repayment and confirmation of loan balances in person, to assure that the entries are free from manipulation. So basically, we will not only take only what the cooperative society is saying, we will also check the statement of the members as to whether the loan repayment confirmation, if everything is done properly. Is that clear? The next one is important, because that is special report has to be made to the registrar if there is any personal profiteering, or if there is any fraud, or if there is any mismanagement, or if there are disproportionate advances which are given. Then in these 4 cases, you will be making a special report to the registrar. What is the meaning of personal profiteering? Say only few members of the managing committee, they are making the profit, and actually all the members are supposed to be benefited by the cooperative society. That is not happening. Only a section of the people are getting benefited. Then in that case, the auditor has to make a special report and give it to the registrar. If there is any fraud with relating to purchases, property, inventory, expenses, whatever fraud you find out, you make a special report to the registrar. If there is any mismanagement of fund, I got the fund for handloom only, but I used the fund for my own food, mismanagement, then in that case, make the special report to the registrar. If there are any disproportionate advances to vested interest group, that means, what is the meaning of disproportionate advances? If you have to make an advance, you have to get collateral, you have to get security. Say, the security is car. The car's value is 30 lakhs rupees. How much of loan can I give to them? If the car's value is 30 lakh rupees, What happened? Yes. If the car's value were, what was I saying? Car's value is 30 lakhs rupees. How much loan can I give to them? I can give a loan for probably 20 lakhs. But here, for the car value of 30 lakh, 1 crore loan is given. That means disproportionate advance to the value of security, or no security, simply given the advance because I like him, because he's my friend, because he's my Nanba Nanbi. So I am giving disproportionate advances. In that case, the auditor has to make a special report to the registrar. Is that clear? So when you'll be making the special report to registrar, when there are serious irregularities, when there is personal profiteering, mismanagement and disproportionate advances to the vested interest group. Audit classification of society. There will be a specific class which is awarded to the society, and that award has to be given by the auditor. Auditor has to award a class to the society. Judgment is based on the criteria specified by the registrar. Who is going to give the judgment as to which award has to be given to which society? The registrar will design that scale. If management is not satisfied with the class, he can appeal to the registrar, and registrar will direct to review the audit classification. Nowhere we have seen for the company and all where auditor will be giving awarding a class to the company like that. We have not seen. Only for cooperative society specifically we are seeing where auditor will be giving an award to the society. Basically, when he is awarding a class, say class A, class B, class C, whatever class that he is awarding, he has to be extremely careful because there is a chance of appeal for the society. Now it is a matter of pride for the auditor. I have awarded something. Now the society is feeling that this is not correct, and he can go and appeal to the registrar. That means maybe what the auditor has given is not proper. So when he is awarding a class, the auditor will be double sure, triple sure, and then only he will be awarding the class to the society. The judgment is based on the criteria which is specified by the registrar. If management is not satisfied, then he can appeal to the registrar, and registrar will direct to review the audit classification. The draft audit report should ask the secretary of the society to convene a managing committee meeting to give the draft audit report. The draft audit report has to be given to the managing committee. For that, you will ask the secretary of the society to convene the meeting. Never finalize the audit report before discussion with the managing committee. All these points are new points specific to cooperative society, and that is the reason why it is given as special features of cooperative society. We started off with examination of overdue debt, where debt has to be classified as 6 months to 5 years and more than 5 years. If there is overdue interest, you please subtract that amount from the interest outstanding. Certification of bad debts. Maharashtra state government has specifically said that the auditor has to certify the bad debts, and only after that they can classify that as bad. But if the state law has not told anything, then who will be certifying? The managing committee has to authorize for the bad debts. Valuation of assets and liabilities is the same. The auditor also has to comment on adherence to cooperative principle, adherence to act and rules. If there is a member loan which is given, then we also have to check in the passbook of that member to see whether the loan has been repaid and all of those things. The special report has to be given to the registrar in the case of 4 points, that is personal profiteering, fraud, mismanagement and disproportionate advances to any interest groups, or no security is received and any advance is given. In that case also a special report will be given. The auditor will be awarding a class to the society, and judgment is based on the criteria specified by whom? By the registrar only. If the society is not satisfied with the class which is awarded by the auditor, the society has the option to appeal to the registrar, and then the registrar is going to review the classification. The draft audit report will be prepared by the auditor and has to be discussed with the managing committee. So the auditor will ask the secretary of the society to convene the meeting with the managing committee, and never the audit report will be finalized without the discussion with the managing committee. All of these are special points specifically for cooperative society, and that is why it is given separately. Is that clear? Very, very clear. Now comes audit of multi-state cooperative society. Till here what we saw is Cooperative Societies Act 1912, and now we are entering into Multi-State Cooperative Societies Act 2002. Very, very clear. Yes, Here, if a cooperative society is operating in more than one state, then we will be referring to Multi-State Cooperative Societies Act. And here, only a chartered accountant within the meaning of the Chartered Accountants Act 1949 can be appointed as the auditor to conduct the audit. Are you able to understand? So if it is a big cooperative society, that means it is operating in more than one state, then only a CA, only a chartered accountant can be appointed. If it is a small cooperative society, who and all can be appointed? A registrar itself will be doing the audit, or he can ask any other person. Who is that any other person? That any other person could be a CA, or a person having government diploma in cooperative accounts, or a person who's done the audit in the cooperative department of the government. So any of these people can be doing the audit only if that cooperative society is operating in one state, more than one state. Who can do? Only a chartered accountant within the meaning of the CA Act 1949 can be appointed as the auditor to do the audit of multi-state cooperative societies. The following persons are not eligible for appointment of multi-state cooperative society: a body corporate, an officer or employee of that multi-state cooperative society, a person who is a member or who is in the employment of an officer or employee, a person who is indebted to the multi-state cooperative society, or he has given a guarantee or he provided any security for an amount exceeding rupees 1000, then he cannot be appointed. That means what they're trying to tell is a person who is a chartered accountant can be appointed as the auditor of the multi-state cooperative society, and that person has to be independent. He should not be related to the cooperative society. He cannot be an officer, he cannot be an employee of that society, he should not be a member of that society, and he should also not be an employee of that officer or employee of that member of the society, and he should not be a person who is indebted to the society more than rupees 1000, or he should not be a person who has given a guarantee for somebody else who has given a loan to the society for more than 1000 rupees. Is that clear? Now, if a chartered accountant becomes a member later, then what will happen? If auditor becomes subject to disqualification after the appointment, then he will be deemed to vacate the office, same as your Companies Act. So, clear? Very, very clear. Appointment of auditor for the first auditor is done by the board within 1 month of the registration. The subsequent auditor, the society itself, in the general meeting at each and every AGM, they are going to appoint. And this first auditor is going to hold office till the conclusion of the first AGM. The subsequent auditor will hold the office till the conclusion of the next AGM. Similar to the Companies Act. Powers and duties of the auditor. What powers and duty does the auditor have? He has the right to access the books. He has, similar to 143 subsection 1 guys of the Companies Act, yes, he has right to access the books, vouchers, and whether they are kept in head office or somebody else. He can require the officer or employee to give such information and explanation for performance of duties of the auditor. The auditor can make enquiry under section 73 subsection 2. What kind of enquiry can he ask? Whether loans and advances on the basis of security are properly secured, whether transactions which are merely represented by way of book entries are not prejudicial to the interest of the society, whether personal expenses have been charged to revenue account, and whether shares have been allotted for cash. If there is shares allotted for cash, whether such cash has actually been received by the cooperative society, similar to your Companies Act. If it is a multi-state cooperative society, till now what we saw, appointment of auditor, similar to Companies Act, powers and duties of auditor, similar to Companies Act, and who can be an auditor? That also only a chartered accountant. In Companies Act also only a chartered accountant within the meaning of the CA Act 1949 can be appointed, and he has to be independent. The content of auditor's report. The financial statement should present a true and fair view as per the information and explanation given to the auditor. In case of the balance sheet, of course, it should be at the end of the financial year. In case of profit and loss account, the auditor's report shall state whether all information and explanation which is necessary for audit has been obtained, whether proper books of accounts have been kept by the multi-state cooperative society and proper returns have been received from the branches not visited, whether report on account of any branch office which is audited by some other person other than the auditor of that multi-state cooperative society, whether that report has been forwarded to him and whether how it has been dealt with, whether multi-state cooperative societies report containing balance sheet and P&L are in agreement with the books of accounts. What they are saying, the first one, they're talking about all information and explanation, whether it is done. Second, books of accounts and proper returns from branches have been received from him. Third is with regard to the branch accounts. Branch, whether it is the reports have been given to him, forwarded to him, and how it has been dealt with. And last, whether the balance sheet and P&L are in agreement with the books of accounts of that society. These 4 points you will have to check for profit and loss, and for balance sheet, whether it is at the end, prepared at the end of the financial year, you will be seeing. 3 and 4 needs reasons in the audit report. What is 3? Whether the report of the branch office, if it is done by some other auditor, whether it has been forwarded by him. If it is not forwarded by him, you need the reasons as to why it is not forwarded and why it has not been dealt with properly. Whether the multi-state cooperative society reports containing the balance sheet and P&L are in agreement with the books of accounts. If it is not agreeing to the books of accounts, then you need to give the reason for the same. Is that clear? This is the contents of the auditor's report. Now comes special audit. Special audit is very, very important because we saw something called as special report. What is special report and what is special audit? You should not get confused. Special report we saw where under special features of conducting an audit of cooperative society, we saw special report. Under that we saw if there is any personal profiteering, or if there is any fraud, if there is any mismanagement, or if there is any disproportionate advances with no security, then you will be giving a special report. What is special audit is what you are going to see right now. The affairs of the cooperative society are not managed with sound business principles. That means what? That means you are having a cow farm. Now you have to milk the cow. Yes. Say for example, you are putting the machine for milking the cow. The instruction in the machine is saying that you cannot milk the cow for more than 30 minutes or more than 1 hour, because the cow is not supposed to give milk after 30 minutes to 1 hour. Yes or no? Agreed. But is anybody following this in reality? Are they following it? They are giving injections for the cow so that the cow can milk 24/7. That is the first mistake. Yes. Secondly, when they are milking the cow for such a long duration, the cow will start forming the pus. Yes. Along with that pus, we don't care. Then blood will come. Along with that blood, everything. We drink that kind of milk only. Yes or no? Now, if I start off by saying, அதாவது ஒரு மாடு நீ டார்ச்சர் பண்றனா, that means you are not following the sound business principles. The affairs of that cooperative society is not managed by sound business principles, or there is an injury to the trade, there is an injury to the business, or there is an injury to the industry in itself, or there is anything which is going to endanger the insolvency of the cooperative society, then in that case a special audit will be done. Is that clear? The 3 points are: the affairs are not managed by sound business principles, there is an injury to trade or business or industry, and anything which is going to endanger the insolvency. If affairs are not managed in accordance with prudent commercial practices, managed as would cause injury to interest of trade or industry or business, the financial position is such that it will endanger the insolvency, then the action by the central government will be taken. The central government will appoint an auditor. He could be a same auditor or he could be a different auditor. When he can appoint, is central government will order for special audit only if he is part of that society, only if that government or state government, either by itself or both, together they are holding how much? 51% or more of the paid up share capital in the multi-state cooperative society. So can I say that a special audit is done by whom? By central government when they hold more than 51%. Then only special audit itself will come into place. The special auditor will have the same powers and duties as the auditor of multi-state cooperative society, but he will be making the report to whom? Whoever is making the appointment, the central government is making the appointment here. So the report will be given to the central government and not to the members of the cooperative society. And the expenses for this auditor will be paid by the multi-state cooperative society, but it will be determined by the central government only. Now, special audit is a scenario where central government or state government or both are being involved when they are holding more than 51 percentage, when they are holding 51 percentage or more, then only a special audit can be asked for. Now, who will conduct the special audit? That same auditor can be appointed or another auditor can be appointed. The central government may appoint a CA or the auditor of that multi-state cooperative society itself to conduct the special audit. Is that clear? Very, very clear with respect to what is a special audit. Now, the central government is given the report. Usually you tell me how long the government will take to respond. They might even take years. Yes. So here they're saying if that central government did not take any action within a period of 4 months, then you can send the multi-state cooperative society a copy or relevant extract from the report with the comments and require it to be circulated to the members or have the copy or extracts to be read in that multi-state cooperative society's general meeting. So 4 months time is given to the central government to take action. Otherwise, you yourself can send it to the multi-state cooperative society and they have to read it in the next annual general meeting. This is with respect to the special audit. In what 3 cases can you ask for special audit to be conducted? If the affairs of the society are not managed in accordance with prudent commercial practices, it is causing an injury to interest of trade or industry or business, or the financial position is going to endanger insolvency. In these 3 cases, you can ask for a special audit. Who will ask for special audit? The central government if they are holding more than or equal to 51 percentage, central government by themselves or by way of state government or together both, then they can ask the auditor of that multi-state cooperative society itself, or they can appoint another chartered accountant to conduct the special audit. Now, this special auditor is going to have the same duties and powers, and the report of that special audit is given to whom? To the central government, and the central government has to take the action within a period of 4 months from the date of receipt of that report. If not, then they can send a copy of that report to the multi-state cooperative society where they will be reading out that report in the next annual general meeting. Is that clear? Very, very clear with respect to what is special audit, and I hope you have no confusions with respect to special report and special audit. Special report will be done only if there are personal profiteering, fraud, mismanagement and disproportionate advances, and here there is no government involved, but for special audit the government gets involved here. Is that clear? Moving on to the next one, that is inquiry or inspection by the central registrar. The central registrar, on request from the below people, can hold an enquiry, or he can ask any other person to hold an enquiry, or general or special order is required for inspection. Basically, he has to get the request from each of these people, and then the central registrar can ask for holding the inquiry, or he can even ask for inspection, but an order is required for inspection. Who are the people who can instigate this inquiry or inspection? A federal cooperative to which this multi-state cooperative society is affiliated, a creditor of the multi-state cooperative society, the board members, but not less than 1/3 of the board members, and not less than 1/5 of the members of the multi-state cooperative society. These people can, not less than means what? Minimum of 1/5 of the board members, minimum of 1/3 of board members and minimum 1/5 of the members of the society can ask the central registrar to hold an inquiry, or the central registrar can direct any person authorized by him to hold an inquiry or even do an inspection. But for inspection, a general or special order is required. However, before holding the inquiry, you have to give a notice. You directly cannot go with your mic and ask, hello, I have all these questions. No, you give a notice of at least 15 days to the multi-state cooperative society so that they can understand, okay, this problem has come, how to tackle this. They also will come to that good mind frame. The central government or the person authorized by him shall have the following powers. For inquiry, what is the power? For inspection, what is the power? For inquiry, he shall at reasonable time have access to the books, accounts, documents, securities, cash, and all the other property which is belonging to the multi-state cooperative society. He can also ask any person who is possession or the custody of books to produce the same at any other place which is specified by him. He may require the officers of the society to call for general meeting by giving notice of not less than 7 days at the headquarters of the society, or if the officer fail to call, then he himself can call for a general meeting. He may summon any person who is reasonably believed to know the affairs of the multi-state to appear before him at any place in the headquarters or at any branch, or he can also examine any person on oath. These are the powers which is given to the auditor who is holding the inquiry. For the person who is doing the inspection, he also has access to all books of accounts, paper, voucher, all these things, and he can also call for a meeting of the society where such general meeting is required, and every officer or member of the society may furnish information with respect to working of society as the central registrar or person making inspection may require. So the central registrar is going to make the inquiry or the inspection, but it has to be instigated by either a creditor or minimum 1/3 of board members or minimum 1/5 of the members of the society or the federal cooperative to which this multi-state cooperative society is affiliated. They will ask the central registrar to hold the inquiry or inspection. And the person who is doing inquiry or inspection will have all of these powers. Now for this also there is a time limit. After the inquiry or inspection is done, the report is given to the central registrar. Now he has a time limit of 3 months of the date of receipt of the report. Now here we are talking about central registrar. In the previous case, we were talking about government. Now, how you are going to remember? Special audit means government is involved. If government is involved, extra 1 month for them. That is the reason why it is 4 months. Inquiry or inspection, only central registrar is involved. So, only 3 months from the date of receipt of the report, he will be communicating the report of inquiry to the multi-state cooperative society or wherever the society is affiliated and whose inquiry the inquiry is needed. Is that clear? Inquiry or inspection, that report time limit is 3 months. Special audit report given to central government, time limit is 4 months. Extra 1 month is given because government is involved. What is special audit? In these 3 cases, action by central government. If the central government is involved, you can do the special audit. Before this, we saw special features of cooperative society audit with regard to overdue debt, bad debt, assets and liabilities. It was the same. Special report can be given to the registrar itself. What is a special report? If there is serious irregularities which is detrimental to interest of society, if there is personal profiteering, if there is a fraud, mismanagement, disproportionate advances, that time you will be giving something called as special report. Then we saw what is awarding a class to the society and draft audit report. Before that, we saw who can be appointed as the auditor, what should be the records, books, what Maharashtra state government told, what is the restriction on shareholding, restriction on loan, and then I showed you one flow as to how it will look from profits, where and all the profit is going to go. To the reserve fund, profit after transfer to reserve fund, not more than 10% of the above to charitable persons, and from that education fund. The education fund will be a charge and reserve fund is going to be an appropriation. What are the uses of the reserve fund? Could be used only for the business of the society, that is for working capital, or it could be used for promoting the objectives or for making any other investments. What kind of investments can you make? Investments can be made only under the central or state cooperative bank. Securities under Indian Trust Act, share securities, bonds, debentures of any other society, but that society must have a limited liability, or any money which is under central or state government. Yes, guys, that's it with respect to audit of cooperative society. I know I was a little fast, but I wanted to cover all the points. If you want, you can even go through the entire audit of cooperative society again, especially this part. The special audit, special report, special features. Yes, this is the part where it started getting confusing. If you want, you can go through that entire part alone again. Yes, guys, I hope it was clear, and that was audit of cooperative societies. And yes, guys, with this, the cooperative societies audit comes to an end. Now I'm moving on to audit of different types of entities, guys. how as an auditor should we audit a government company, that is government audit. If it is a cooperative society, then the way you have to audit must be different, because the rules of the cooperative society is different, rules of government company is different, rules as to how a hospital will function, a club will function, a theater will function is different. And that is the reason why as a chartered accountant we have to know how we have to audit these different types of entities. In that, the first one that we are going to study is government audit. Now there are two big ones, guys, that is government audit and cooperative society. I will be doing both in depth for you all. Starting off with government audit. What is the meaning of government audit? It is the objective, systematic, professional and independent examination for a public entity. Basically, if it is a public entity, either a state government or central government owned entity, then an audit will happen to that entity, and the audit will happen to the operations of that entity, and we will be examining the financial and administrative and other operations of a public entity. Made subsequently to their execution for the purpose of evaluating and verifying them, presenting a report. Here also we will be giving a report, and this report will contain all the explanatory comments on the audit findings. I have found these points, and for this I have my explanatory comments also. And this is the only type of audit where you will not only be concluding but also giving recommendations as to how to become better. Because government audit is basically whose money? Whose money? The money of the public. Yes, the money of the public is used by the government to do something good for the public. Basically, the government is taking money from the public and giving it back to the public. Yes or no? So in that case, as an auditor, it is our duty to see whether they are having all their operations, financial operations, administrative operations, and all other operations properly. We will be concluding whether their operations is proper, and we will also be giving recommendations for future actions by the responsible people. That also will be given, recommendations also will be given for the government audit. Is that clear? Government audit is the objective, systematic, professional, independent examination of financial, administrative and other operations of a public entity, made subsequently to their execution for the purpose of evaluating and verifying them, to present a report having explanatory comments along with conclusions and recommendations for future actions by whom? By all the responsible officials. Now, if you split it and read, then the whole paragraph becomes easy. Yes, here we split that entire paragraph into different points, different keywords that you have, that you should remember. What are the objectives of government audit? There are three objectives to government audit. The first one being, it is basically accounting for the public. Like I said, it is the money of the public, which is again given to the public. Basically taking money from the public and நாட்டுக்கு நல்லது பண்றது, giving it back to the public. So some kind of an accounting has to be there. That is the first objective of government audit. The second objective of government audit is appraisal of government policies. What kind of policies will be there? Fiscal policy, monetary policy, how much of cash must be there in the economy, what should be the money supply, what should be the credit ratio, what should be the multiplier of that money supply. All these things will be discussed in the policies, the monetary policy. So appraisal of the government policy is also one of the objective of government audit. The third one, base for corrective action. I already told you the government audit not only gives the conclusion but also the recommendations for the future actions. That itself becomes the third objective of the government audit. This gives a base for the corrective action. Audit observation based on factual data collection also serves to highlight the lapses of the lower hierarchy, thereby helping the supervisory level to take the corrective measures. These three are what? Objectives of government audit. 3 points are, they are accounting for public funds, government policy, and base for corrective action. Administrative accountability. Government audit is neither equipped nor intended to function as an investigating agency. Nowhere we have seen that audit is like investigation. Audit is separate, investigation is separate. For government audit also, do not think like, oh, definitely fraud will be here, I will investigate into the matter. That is not your job. You are not an investigating agency. Government audit is neither equipped nor intended to function as investigating agency. Then what is the main objective? It is for these things, that is to give a financial, administrative and other operations of a public entity to see how it is working. The main objective is combination to ensure accountability of administration to the law and functioning as an aid to the administration. In India, the function of government audit is discharged by independent statutory authority of the C&AG, Comptroller and Auditor General. It is not controller, guys. It is Comptroller and Auditor General, through the agency of the Indian Audit and Accounts Departments. Audit is a necessary function to ensure accountability of the executive to parliament and within the executives of the spending agencies to the sanctioning. C&AG watches that various authorities act as per the constitution, as per the law and conform to the rule and order. There are 4 things that you have to follow: the constitution, the law, the rule and the order which is made thereunder. So all these 4 things, the C&AG is going to watch whether the various authorities are acting as per these 4 things. Now, the auditor of public company, who is going to appoint? Anybody here who wants to do these government audits? I want to become the comptroller and auditor general. I will write the government exam for that. Anybody like that? You must aspire for that, guys. Lots of power and of course lots of money. I'm not saying bribe and all. Really, government itself gives very good accommodation, very good car, very good people to take care of everything. Everything will be taken care of, and apart from that, a good handsome amount of salary also will be given. So who is going to appoint this person? Basically, it is a very, very big person. Yes, very big person will be appointed by the President of India. Only the President of India can appoint this person. Can you remove this person? No, you cannot remove. As and when you wish, it will be removed only if there is any misbehavior or only if there is any incapacity, or both the houses of parliament, if more than majority, that is more than 2/3 of the members who are present and voting are saying this person has to be removed, only then they will be removed. Both the houses of parliament has to be the Rajya Sabha and Lok Sabha. Those are the 2 houses of parliament. In that, by a majority of not less than how much? 2/3. Majority is usually 1/2. But here more than 2/3 members from both the houses of parliament who are present and voting has to remove the person who is being appointed for the government audit. The parliament is competent to make laws to determine the salary and other conditions of service. Who is going to determine the salary? The parliament itself will be determining the salary and the conditions of the service. Who will make the appointment of this person, appointment of the auditor? The President of India itself will make the appointment of the auditor. Duties of C&AG, there are 3 things with respect to C&AG, guys. You will be studying about roles, duties and powers. What is the difference between role, duty and powers? I will tell you at the end of the government audit. For now, I'm going to skip the duties of C&AG. Powers also, the 4 powers. I will come back to it later. Now going to expenditure audit. What is the meaning of expenditure audit? Previously, you know what happens, guys. When government audit happens, the auditor is only inclined towards the expenditure. Nowadays, it's not like that. We do 3 types of audit. One is expenditure audit, one is revenue audit, one is audit of stores and inventory. Government also has stores. Government also has stock. What is a stock that the government is holding? All your ration rice, ration sugar, all of that is a stock that the government is holding. So that also you have to audit. So audit of stores and inventory and all the expenses that the government is doing. What is expenses that the government will do? Say the government is constructing a bridge, that is an expense. Government is constructing a school, that is an expense. Government is changing the secretary into the hospital into something else. All that is expenses which is made by the government. So as an auditor, we have to see the expenses, we have to see the revenue, and we also have to see this is audit of receipts, and we also have to see the audit of stores and inventory. Now, what is this audit of commercial accounts? You have to finish this and then we will jump to Audit of Expenses, and then we will go to Audit of Receipts, and then we will go to Audit of Stores and Inventory, and finally we will come to C&AG, the three things which I told you that I will do in the end. Is that clear, guys? Now, Audit of Commercial Accounts. What is this? Departmental concern engaged in commercial and trading operations. What kind of commercial and trading operations happens? Say, for example, there is a toll plaza. You all have seen the toll plaza, how much they collect in that toll booth. 50 rupees, 100 rupees, they collect in that toll booth, one way, two way. Yes, now that is a commercial activity. It is a department concern which is engaged in commercial activities. Now, you know this post office, postal. Nowadays, not many people are using, but previously they were using these postal services. Yes, postal service. Now they're closing the postal services. They made one announcement also. Very emotional for so many people. Now, this postal services is what? It is a departmental concern engaged in commercial activities. Now, these public transport, postal, toll plaza, all of these are department concern engaged in commercial and trading operations. Why I'm coming to these commercial accounts? You have to know as an auditor what you're going to audit. When you simply say government audit, what is there in this government audit, you have to understand. Statutory body or corporations, for example, housing department corporation, they are responsible for building houses for all the underprivileged people also. So that is a corporation, statutory body or corporation. Now you as an auditor will have to do audit for that also, housing department corporation. Government companies. What is this government company? For electricity generation, we have that Tamil Nadu. What is that for electricity generation? TNEB. Tamil Nadu Electricity Board. That is actually a government company. Apart from that, TNSMC. What is this? Tamil Nadu State Marketing Corporation. What is the meaning of that? Tamil Nadu State Marketing Corporation. TASMAC, that is TNSMC. That is also major revenue making for the government. So we have to audit that also. It is a government company. So these three things predominantly is the audit of commercial accounts for a government. Department concerns are undertaken in the same manner as any department of the government where commercial accounts are kept. Statutory bodies, depending on the nature and type of the statute governing the bodies or corporations. Government company is conducted by their own auditors under the statute appointed by C&AG. In addition, the C&AG conducts a supplementary test audit of the accounts as well as periodical financial audit and appraisal of the performance. These are reviewed, condensed in the audit report. C&AG has adopted the mechanism of the audit board comprising of representatives of the audit and nominees of the government. Only for government company, they're talking something about supplementary test audit where test audit, that is audit for few items will be done again, that is supplementary to the primary audit, that is supplementary test audit can be done. And one more thing with respect to audit board is there for government company. Who is there in this audit board? It is basically like audit committee, few members who are from the audit team and few members from the government also will be there as part of the audit board. Is that clear? Now I am going to the expenditure audit. For our example, I am going to construct a bridge here. I am going to construct a big bridge here. For that, the government is going to spend how many crores? We have to talk in crores only when we are doing government audit and all. How many crores for the bridge? Please tell me, guys. 100 crores. Okay, very good. Because not only bridge has to have a side pavement and in that people have to walk. In that lights have to be put in the night. I will put a chess-like bridge, chess-like. It is there in Chennai, yes. Like a chess they made. So all those fancy things I'm doing, I'm going to spend 100 crores for this bridge. Now, whenever there is an expenditure which is going to happen, there has to first be a rule and order. It aims to ensure that expenditure conforms to the relevant provisions of the Constitution and of the laws and rules made thereunder. It also seeks to satisfy that the expenditure is in accordance with financial rules, regulations, and orders issued by competent authority. What is the first step for any government who is going to do an expenditure? There has to be a rule and order. The second step is having a sanction. You can have a general sanction or a special sanction. What is the meaning of the sanction? Say, for example, a rule and an order will basically say a bridge is necessary here. There is lots of traffic which is happening here. Traffic jam is happening. 6 o'clock, if the jam happens, at 10 o'clock only it is getting cleared. So if a bridge comes in this place, then we are going to reduce the traffic by more than 50%. So we are constructing the bridge. Now the rule and the order will say, okay, now there comes the sanction. How much money do you actually want for the bridge? I will say that I want 100 crores. Now the government will say, I am sanctioning 25 crores upfront. General sanction of 25 crores. More than this, if you want, you please get the permission again. So after 25 crores, again and again, you will come and get the sanction to me. That is general sanction and special sanction. That is the second step. The third step, okay, I have sanctioned. Now is the time I have to give the appropriation of the funds. The appropriation happens with respect to the provision of the funds. The funds has to be disbursed, and that is the third step for any kind of expenditure by the government. What are the three steps? The first one is there should be a rule and an order. The second one is there should be a sanction. It could be either a general sanction or a special sanction. And the third one is the appropriation of the funds happens, and that is audit against provision of funds. Is that clear? Very, very clear. Yes. Now we go to propriety audit. Propriety audit means the auditor basically sees if there is any expenditure which is improper, or this expenditure could be avoidable, or this is an ineffective expenditure. Say, for example, they were constructing the bridge here. When they constructed the bridge, they understood that this bridge is not looking fancy. I will construct the bridge this way, like a music. Yes, that musical note. I am going to construct the bridge this way, just for it to look fancy. Is it required? It is an avoidable, ineffective expenditure. Maybe, yes, it is coming within 100 crores, but it is not necessary. Maybe if you did that, maybe rule and order is saying, okay, you can construct the bridge, but still it is an avoidable expenditure. Because I did this, I spent extra 20 crores. Otherwise, I would have finished it in 80 crores itself. If I had just constructed like this, I would have finished it in 80 crores itself. Like that, if it is an avoidable expenditure, the auditor has to find that out under propriety audit. If it is improper, if it is avoidable, or if it is an ineffective expenditure, then that will be caught under propriety audit. Some general principles have been laid down in the audit code, which have for long been recognized as standards of financial propriety. What is the meaning of performance audit? Under performance audit, we have three types of audit. We have efficiency audit, we have economy audit, and we also have effectiveness audit. What is the meaning of efficiency audit? Efficiency audit looks into whether various schemes or projects are executed and their operations are conducted economically, and whether they are yielding the results which is expected out of them. Now, after constructing the bridge, no one is using the bridge. They are going down only, and still more traffic jam is happening. The result which is expected out of the bridge is not happening. Why? When they constructed the bridge only, 5 times the bridge fell down, and few people died. What will happen? Will people get the trust to go on top of that bridge? No chance. It is not serving the purpose. It is not yielding the results which is expected out of them. So that is the efficiency audit. This is coming under performance audit. Under performance audit, there is efficiency audit, economy audit, effectiveness audit, and efficiency come performance audit. What is economy audit? Whether everything has been done economically. What everything? Whether the financial resources, human resources, physical resources are economically purchased. Physical resources, human resources, financial resources. What is human resources? The labor who is coming and constructing the bridge, whether we are paying them in an economical way. What is the physical resources? Your cement, sand, the water, all of these are physical resources. What is the financial resources? The resources which is giving you the money. Who is giving the money? They will be getting the loan from the bank. How much interest the loan is charging? That is a financial resource. Should also be done in an economical manner. Effectiveness audit. It is an appraisal of the performance of the program, scheme, project with reference to the overall targeted objective as well as efficiency of the means adopted for the attainment of the objectives. What is the objective for you? The objective is to reduce the traffic. Are you able to do that? Efficiency of the means adopted for the attainment of objective, and whether your overall targeted objectives, are you able to actually see some improvement, see some difference? Efficiency cum performance audit is an objective examination of the financial and operational performance of an organization, program, authority, or function, and it is oriented towards identifying opportunities for greater economy and effectiveness. Now we are under performance audit. Under performance audit, we have efficiency audit, economy audit, effectiveness audit, and efficiency cum performance audit. The procedure for conducting the performance audit is identification of topic, preliminary study, planning stage, execution stage, and finally the reporting. These 5 you already know. Yes, that is the procedure for conducting the performance audit. Under performance audit only we had efficiency audit, economy audit, effectiveness audit, and efficiency cum performance audit. Efficiency, economy, effectiveness, that is effective and efficient. We always see the use that together, right? Apart from that, there is also economy audit. Then comes efficiency cum performance audit. So for the performance audit, the 5 steps are identification of topic, preliminary study, planning stage, execution of audit, and finally reporting. This is the expenditure audit. Audit against rules and order. Now, against rule and order, what should you actually know? Here, you have to know what is CFOI, that is Consolidated Fund of India, what is Contingency Fund of India, and what is the meaning of public account. This is actually foundation syllabus, Consolidated Fund of India, Contingency Fund of India, and all of those things. Now, say for example, when you talk about Consolidated Fund of India, I will just open the plain sheet. Yes, when you talk about Consolidated Fund of India, I want you to think of a bank account of a company. Consolidated Fund of India. I want you to think of a bank account of a company. What happens in a bank account? All the money which comes in comes to the bank account, and all the money which goes out from the bank account. Same way for a government, the Consolidated Fund of India is basically any money which comes in and any money which goes out happens from the CFOI, that is Consolidated Fund of India. Is that clear? Very, very clear. What is this contingency fund? I want you to think of contingency fund as the petty cash account. What happens in the petty cash account? Some money comes from the bank account here. Yes, some money comes from the bank account here, and you maintain a balance at this petty cash, and you keep spending for your daily expenses from your petty cash account only. Is that clear? Similarly, the contingency fund is basically an emergency fund. The money comes from the Consolidated Fund of India only, and for any emergency, it is not possible for you to get the approvals from the CFOI. So you will be spending from the contingency fund itself. Now, when the money is reducing in the contingency fund, from where are you going to get the money? You are going to get it from the Consolidated Fund of India. Are you able to understand? The Consolidated Fund of India is basically like a bank account, and the Contingency Fund of India is basically like a petty cash account. With this in mind, you can get into the audit against rules and orders. I also spoke about the public account. Public account is the money of the public. Say, for example, you would have heard about post office savings scheme. What happens in post office savings scheme? The money is taken from the public and it is kept with the government itself. But when the public asks the money back, that the government should be in a position to give the money. So that has to be kept separately because liquidity has to be maintained here. That is public account. The money of the public has to be kept separately. The rules, regulations, and orders against which regulatory audit is conducted mainly fall under the following categories. Rules and order regulating the powers to incur and sanction expenditure from CFOI or of a state and contingency fund of India or of a state. Rules and order dealing with the mode of presentation of claims against government withdrawing money from the consolidated fund of India, contingency fund and public account of the government. Rules and orders regulating the condition of service, pay and allowance, pensions of government servants. It is a function of audit to carry out examination of various rules, regulations and orders which is issued by the executive authorities. Why are the rules given? To see whether they are not inconsistent with any provisions of the constitution. You have to be in par with the constitution. They are consistent with essential requirements of audit and accounts as determined by C&AG. Requirements of audit as determined by C&AG. They do not come in conflict with order or rule made by higher authority. Obviously, it has to be under the constitution, it has to be under any other rule which is made by higher authority, and it has to be consistent with the audit which is determined by C&AG. In case they have not been separately approved by competent authority, the issuing authority possesses the necessary rule making power. The next is audit of sanctions. I already spoke about general and special sanction here. The auditor has to ensure that each item of expenditure is covered by a sanction, either general or special from the competent authority. Audit against provision of funds. The expenditure incurred has been on the purpose for which the grant and appropriation have been provided, and that amount of such expenditure does not exceed the appropriation made. What is propriety audit? The auditor tries to bring out cases of improper, avoidable or ineffective expenditure even though the expenditure has incurred in conformity with existing rules. Audit against propriety seeks to ensure that expenditure conforms to the principles which have been stated as follows. The expenditure should not be more than the occasion demands. That means for a bridge, if it should be completed in 50 crores, do not take 100 crores, more than what the occasion demand. Every public officer is expected to exercise the same vigilance in respect of expenditure incurred from public money. No authority should exercise its power of sanctioning the expenditure to pass an order which will be directly or indirectly to its own advantage. Say, for example, when you construct a bridge like this and there is a house here, under the bridge, what will happen to the house? This house is the person who is constructing the bridge. What will happen to the house? The value is going to reduce. Say, for example, the house is in this place. Then the value is going to increase because you just come out of the bridge and you come to this person's house. Then the value is going to increase. Yes or no? Now, what this person who's constructing the house is going to do? Halfway through, he decided, no, bridge should not be constructed. You please start from scratch and you start the bridge from here and you construct the bridge here so that my house will increase in value. Can he do that? No authority should exercise the power of sanctioning expenditure which will be directly or indirectly for his own advantage. You cannot do like that. And public money should not be utilized for benefit of a particular person or section of a community. Do not use the public money for benefiting only one section of community. It has to be beneficial for the society at large. Unless there are few exceptions to this, where you can use public money only for section of society. Exceptions. What are the exceptions? The amount of expenditure involved is insignificant. That means I'm using 10,000 rupees or 2,000 rupees only for a specific section of society. Then it is insignificant. Claim for amount can be enforced in a court of law. Expenditure is in pursuance of recognized policy or custom. Say, for example, they are constructing the bridge in the month of September. October month, what happens? Big festival comes. Yes, Diwali festival comes in the month of October. Now, September end, all the employees, that is all the laborers are saying, I want to go to my hometown. You please give me the money to go to my hometown, or Diwali bonus. Everyone will get the Diwali bonus. In the entire state, in the entire country, everybody is getting Diwali advance, Diwali bonus and all of those things. Now, if it is a custom in the country itself, if it is a custom in the state itself, then you also can do it even if it is going to do what? Benefit only a particular person or section of a community. The expenditure is in pursuance of a policy or a custom. The claim for the amount can be enforced in the court of law, or amount of allowance such as traveling allowance to meet expenditure of a particular type should be so regulated that allowance on the whole should not be a profit for the recipient. Say for example, during Diwali they want to go to their hometown. So I am telling them, okay, I will book the travel tickets for you. Then the employees are saying, I will book it myself, sir, you please reimburse to me. So they are saying, okay, you please go in train. How much? All these people will be from Bihar and all those states, right? So they are going back to their hometown. Now when they go back to their hometown, how much will it cost for train ticket? Normal train ticket, not AC and all. Normal ticket, 800 rupees. Yes, I will say, okay, for 800 rupees per person, I am sanctioning. What these people are doing, they are going in bus. Bus is only 250 rupees. The remaining is what? Profit for them. Please don't do all of those things. That only they're telling in the last part. The amount such as traveling allowance, which is granted to meet an expenditure for a particular type, should be so regulated that allowances are not a source of profit to the recipients. It should not be a source of profit to the recipient. If it is a reimbursement, that means there is a reimbursement. Don't make profit out of that reimbursement and all of those things. So exception to the exception. Yes. Under propriety audit, we saw that any expense which is improper or avoidable or ineffective expenditure, you have to find out under propriety audit. The expenditure should not be more than what the occasion demand, and no person will have the authority, should exercise the power on sanctioning the expenditure, which is basically for his own advantage. The public money should not be used only for a specific section of the community, except the amount involved is very small. The claim can be enforced by court of law. The claim is as per the policy or a custom, or the amount is for traveling allowance. However, the traveling allowance should not be a source of profit for the recipient. Is that clear? It is a responsibility of the executive department to enforce the economy in public expenditure. We already saw what is performance audit. EEE, what is that? Effectiveness, efficiency, and economy audit. What are the steps for performance audit? Identification of topic, preliminary study, planning, execution of audit, and reporting. This is the expenditure audit, guys. Basically, when you have to audit, you have to understand as to how the expenditure will take place in the government. Then only you will be able to see whether it is as per the rule or not, whether it is as per how it has to take place. Now, you know, when the government makes an expenditure, there has to be a rule, there has to be an order, there has to be a sanction. It could be a general sanction or a specific sanction, and there should be a appropriation bill. That is only the provision of funds. Now, when you know these three steps, you know that, okay, as an auditor, I will check whether there is a rule, whether there is an order, whether there is a sanction, and all of those things you are going to check. That is your expenditure audit. And finally, you went to performance audit and propriety audit. Propriety audit is basically where you're seeing whether any expenditure is improper, or it could be avoidable, or it could be ineffective. Performance audit also similar only, but under performance audit we have efficiency, effectiveness, and economy audit. And efficiency come performance audit in the end also we saw. That is expenditure audit, guys. Very, very clear? Yes. Now I'm moving on to audit of receipts. I told you from olden days, they are doing only expenditure audit for government audit. That is the reason why it has evolved and there is lots of content there. If you see audit of receipts and stores and inventory, this much only is there. Now, for you to understand how you have to audit of receipts, you have to first understand what is the receipt for the government. So you all tell me what will be the receipt, that is the income for the government. Yes, the taxes that you are paying is definitely a receipt. Any sale of goods or services is a receipt for the government. Yes, anything else? Your police mama collecting the fine and any kind of fees that the government is collecting is also a also a receipt for the government. Now, with this in mind, if you see how you have to audit, then you will understand properly. But before we get into that, I want to classify the receipts into two. That is revenue receipt and capital receipt. What happened suddenly? Well, what was I saying? I want to classify the receipts into two. Yes. The receipts I want to classify into two: revenue receipts and capital receipts. The name itself, it tells you what is the meaning of revenue receipts and capital receipts. Revenue receipts, again, I'm splitting into two: tax revenue and non-tax revenue receipts. Capital receipts, I'm splitting into two: debt capital receipts and non-debt capital receipts. See here, all this is not there in your exam, but you need to understand what is receipts for you to understand fully the points as to how you will be auditing them. Is that clear? Now, what is revenue receipt split into? Tax revenue and non-tax revenue receipts. Tax revenue is basically the tax that they are collecting. What is non-tax revenue receipts? I will come to that a little later. What is capital receipts? Debt capital receipts. Say, for example, the government is taking loan, or government is taking the treasury bonds, treasury borrowings, all that is debt capital receipts. Any capital receipts which is not creating a debt, that is divestment or disinvestment. Say, for example, nowadays you will see there are so many government companies which is actually going for privatization. What are they actually doing? They are selling it from the government to the private people. That is disinvestment. When it happens, then the private is going to give the money to them. It is a receipt. It is a capital receipt. Is it creating any debt? No, it is a non-debt capital receipt. Say if the government is giving a loan and the loan is being recovered right now, that is a receipt. Recovery of loan is a receipt for the government, and is it creating any debt? No, it is a non-debt capital receipts. Recovery of loan is non-debt capital receipt. Disinvestment, non-debt capital receipt. Debt capital receipt, it is a receipt and it is capital nature and it is creating a debt for the government. Now you understood fully about capital receipt. Coming to revenue receipt, you already know what is tax revenue, and non-tax revenue is all your other things, your fees, fines, police mama getting the money, and what else we saw? Sale of goods and services, the money which comes through that, all that is your non-tax revenue receipts. Very, very clear. For government, what is receipt split into two? Revenue, capital. Again, revenue receipt split into two: tax revenue and non-tax revenue. Capital receipt split into two: debt capital receipt and non-debt creating capital receipt. Is that clear? Very, very clear. Now, with this in mind, when you see as an auditor what and all you have to check, it becomes very, very easy. Whether all revenue or other debt due to the government have been correctly assessed, realized, and credited to the government account by the designated authority. Due to the government becomes a receipt for the government, that is only the capital receipt. Whether adequate regulation and procedures have been framed concerned to secure an effective check on assessment, collection, and proper allocation of cases. Whether such regulation procedure are actually being carried out. The first one, whether there is a formula to see whether they are actually collecting, whether that formula has actually been followed by the government. Whether adequate checks are imposed to ensure prompt detection and investigation of irregularity, double refund, fraudulent or forged refund vouchers, or other loss of revenue through fraud or willful omission, or negligence to levy or collect taxes or to issue refund. Now, what they're talking about, say for example, you are paying the income tax, correct? You know you can get the refund of the income tax that you are paying. Say for example, TDS has been collected by somebody else and they'll be paying the TDS for you. Now when you have to pay the tax, if the TDS amount is much more, then you can collect the refund from the government. Now say the IT of the government, there is some issue. For anyone who's processing the refund, they are getting double refund, triple refund. 10,000 rupees I have to give. I have given 30,000 rupees. Now it is a loss for the revenue. If there is any loss for revenue, or if there is any forged refund voucher, or if there is any double refund which has been done, are there any adequate checks by part of the government to see whether there is any loss of revenue? The auditor should review the systems and procedures to see internal procedures adequately secure, correct, and regular accounting of demand, collection, and refund, and pursuant of dues up to final settlement, and to suggest the improvement. The extent and quantum of audit required to be done under each category of audit are determined by C and AG. These are neither negotiable nor questioned. No questions asked. They will tell, you have to do. Extent and quantum of audit are structured in accordance with the design of test check, random sampling, general review, in-depth study of specified areas. These 6 are what? Audit of receipts. The auditor provides for checking whether all the revenue and the debt which is due to the government, whether it is correctly assessed, realized and credited, whether the adequate regulations are properly there, whether those regulations are actually carried out, whether adequate checks are there for any loss of revenue like forged refund voucher, any fraudulent refund voucher, any investigation of irregularities, double refund, all those points. Review of the systems and procedures, that is the internal controls for the government, whether it is proper, and extent and quantum of audit, whether it is determined by the central comptroller and auditor general, and no questions asked to the C&AG. That is audit of receipts. Is that clear? Just 6 points. Audit of stores and inventory. What is the inventory? For our example, we will keep rice, sugar, all these things as inventory. Now, when you go and do inventory, what will you do? You will be doing physical verification of inventory. Very good. What else will you do? You will see how is the internal controls which is there. Now, inventory is basically coming from where it is affecting 2 different items. What are the 2 different items? Inventory is affecting purchases and inventory is affecting sale also, because as soon as you purchase, it is going to come to your stock, and any sale that you do goes out from the stock. So whether the purchase has been done properly, whether the custody is kept properly, whether the sale has been given properly, you will have to see that. Whether the internal controls is properly there, you will have to see. Whether the purchases are properly sanctioned economically and made in accordance with the rules of purchase. Purchase means it comes to expenditure. For expenditure, what is there? Whether it is properly sanctioned, whether rule is there, whether order is there, whether it is economically done. All those points are with respect to the expenditure. To ensure that prices paid are reasonable and in agreement with those shown in the contract for the supply of stores, and quality and quantity are furnished by inspecting and receiving units. To check the accounts of receipts, issues and balances regarding accuracy, correctness and reasonableness. If there is any idle inventory, how are you going to value that? And finally, valuation of inventory is to whether it has been seen carefully. You will have to see that. That is audit of stores and inventory. Very, very simple. Normally, like how you do audit of stores, same way you're going to do it here also. We finished audit of expenditure, we finished audit of receipts, we finished audit of stores and inventory also. The last part is respect to C&AG. I told you I will do that in the end. C&AG, there are 3 questions which can be asked with respect to C&AG. The first one is the roles, the second is the duties, and the third is the powers. Don't use them hand in hand. They have completely different meaning. What is the meaning of roles of C&AG? Roles basically means the functions. What are the functions of C&AG? The C&AG has to appoint the government company auditor. That is the first function. What is the second function? They can ask for re-audit. Supplementary audit can be done. Re-audit can be done. They can also do test audit. Test audit is basically redoing a specific area. Supplementary audit is redoing the entire audit again. So these 3 are what? They are the functions. That is the roles of C&AG. Is that clear? Very, very clear. Now I am moving on to the duties of C&AG. What is the meaning of duty? Why is this going off again and again? The duties basically means the responsibilities of C&AG. What is the responsibilities of C&AG? They will be compiling and submitting the accounts to both of the union and the state to the President of India or the Governor. They will see all the general provisions of audit, whether it has been properly done. What are the general provisions of audit? You already know: Consolidated Fund of India, Contingency Fund of India, and if any public account, it has to be maintained properly. An audit of all the revenue and expenditure has to be done properly, and the responsibility lies with C&AG, Comptroller and Auditor General. Audit of grant or loans has to be there, and here you have to learn what is the meaning of substantially financed. The terminology substantially financed. We will go to the theory part. That time it will get cleared for you. Do not worry. Audit of receipts of the union and the state has to be seen properly. Audit of accounts of stores and inventory has to be done properly, and audit of government company and corporations has to be done properly. Is that clear? All of these are responsibilities, that is the duties of C&AG. What is the meaning of powers of C&AG? What is the meaning of powers? The authority of C&AG. What authority do they have? They can inspect the books of accounts at any time. They can require that books of accounts to come to him. Require books to come to any other place also. He can call for information, he can question, or he can call for any kind of information. He can dispense with any part of the audit. All these four are powers. Now, when I put all the three questions in one place, now the magic happens. Now you are able to understand what is roles, what is powers, and what is duties. I have also written the meaning here. Powers means authority which is given. Roles means the functions that they have to do. The duty, it is the responsibility of the C&AG to do all these points. Is that clear? Now I am going to the text. Role of C&AG. Power to appoint a government company audit. Section 143 subsection 5 of the Act states that in the case of government company or any company where it is controlled directly or indirectly by central government or state government or partly by central government or state government, then the appointment of first auditor and subsequent auditor will be done by C&AG only. C&AG of India will appoint. So whoever is appointing, they will only get the report. So the auditor so appointed shall submit a copy of the audit report to the C&AG of India. They have the power to conduct supplementary audit and comment thereupon. The C&AG shall, within a period of 60 days from the date of receipt of audit report, have a right to conduct a supplementary audit and comment upon or supplementary audit under 143 subsection 6, and it will be placed before the AGM of the company at the same time. What is test audit? Further, without prejudice to the provisions relating to audit, the C&AG of India may, in case of any company covered under this section, by an order, ask for test audit to be conducted, and the provisions of all these things will apply. Is that clear? These three are roles of C&AG: power to appoint, supplementary audit, and test audit. Going on to the next one. Powers of C&AG. The power is to inspect any office or accounts, to control, including asking the officer who is responsible for creation of the subsidiary account to require that books of accounts to come to him or to be sent to any other place, to put such questions or make such observations which is necessary. In carrying out the audit, the C&AG has power to dispense with any part of the detailed audit, to apply such limited checks as he may determine. These four are powers of C&AG. The next one is the duties of C&AG. First one is compile and submit the accounts of the union and state. To whom are they going to give? They are going to give it to the president or the governor of a state or administrator of the union territory legislative authority. The general provisions relating to audit. Here we spoke about CFOI, we spoke about contingency fund and public account. Audit of receipts and expenditure. Here only I told you that I will be talking about what is the meaning of substantially financed, where anybody or authority is substantially financed by a grant or loan from the Consolidated Fund of India or of any state or of any union territory, then the C&AG shall, subject to the provisions of any law for the time being in force applicable to the body or authority as the case may be, he will be able to audit all the receipts and expenditure of that body or authority and to report on the receipts and expenditure which is audited by him. Basically what they are saying is, if there is any other person who is substantially financed by the Consolidated Fund of India, what is the meaning of substantially financed? Is there any number attached to it? Yes, where the grant or loan to any body or authority from Consolidated Fund of India or of any state or union territory is not less than 25 lakhs, that is more than 25 lakhs, and the amount of such grant or loan is more than 75% of total expenditure of that body or authority. Now, most of the expenditure of that authority is given by Consolidated Fund of India, and that amount is more than 25 lakhs, then you will be calling that as what? Substantially financed. Is that clear? Very, very clear. Now, if there is any authority or if there is any regulatory authority which is being substantially financed, then the audit can be conducted for that regulatory authority also. Audit of grants or loans, where any grant or loan is given for any specific purpose from the CFOI, then the C&AG will scrutinize the procedures. Audit of receipts of union and state, it shall be the duty of the C&AG to audit all receipts which is payable into the CFOI and each state and of each union territory to satisfy himself. Audit of accounts of stores and inventory, audit of government company and corporations, the duties and powers of C&AG in relation to the audit of accounts of government company shall be performed and exercised by him in accordance with the provisions of Companies Act only. The C&AG only will appoint the auditor, appointment of first auditor and the subsequent auditor. So obviously the report will be given to the C&AG. Is that clear? Now here only one thing newly that you studied is under receipts and expenditure. You will also be doing the audit of any other authority which is being substantially financed by the Consolidated Fund of India of the state or of any other union territory legislative authority. What is the meaning of substantially financed? If the amount is not less than 25 lakhs and the amount of the grant or loan is not less than 75% of the total expenditure of that body or authority, then it becomes a substantially financed body or authority. Then for that also the audit will happen. Is that clear? This is with respect to C&AG, guys. The roles, duties and powers. We started off with what is the objective of government audit, and then we went to who is going to appoint and all of those things, and then we went to the most important part, that is audit of commercial accounts. Under that, what and all is their department concerned, Tamil Nadu State Marketing Corporation and all of those things. Then we went to expenditure audit, then to audit of receipts, then to audit of inventory, and then to C&AG's rules, duties and powers. Clear? Very, very clear. Yes, satisfied with government audit, guys? In just 50 minutes, we have completed the entire government audit, and with that, the government audit comes to an end. Let us start off with bank audit, guys. So this is one of the chapters where people feel like too much content, ma'am, so much to study and all of those things. Yes, there is so much to study here, but also understand. Once you become a chartered accountant, you will be doing different kinds of audit like statutory audit, internal audit, bank audit. So bank audit is actually for people who are seniors in the industry. So basically, when you're telling your friends saying, I just went for bank audit, there is some sense of, I have done something great. There is actually a sense of that when you do bank audit, when you go in person and when you do bank audit, you actually feel that pride that you are doing the audit of this big bank and all of those things. It happened to me also, guys. This was not bank audit, but it was a major merger between Indian Bank and Allahabad Bank. So Indian Bank had appointed us, and basically what we had to do is vendor rationalization. For that itself, I was feeling as if I am the consultant for Indian Bank, and all of those things were happening in my head. So this is actually a sense of pride when you go there practically to do it. So have that mindset when you are studying also, for you to enjoy this chapter as well. So starting off with bank audit here, I want you to see this into two different split, guys. So this is going to be your first split, and this part is going to be your second split. In the first half, you are going to study about RBI's responsibilities. What is the function of the bank? What are the acts which are going to govern the bank audit? And as an auditor, what are the powers that we have? Who are you? Who is going to appoint the auditor of the bank? How will you conduct an audit? What is the procedures? And what is the meaning of advances and all of those things? Actually, I think I have put it wrongly till here. Yes, till here is one part. From the advances, it is actually like the second part of audit, because here they're talking about agricultural advances, advances to staff, and how should you compute the drawing power, what is called a sanction limit, or how will you audit the advances. All of these things will happen in the second part. So in the first part, you will be learning about the basics and how you will conduct the audit. In the second part, the major thing, that is advances, come, and finally you will be learning about income and expenses also. Why so many things about advances, you tell me? Advances is basically loan. Loan will come in which side of the balance sheet? Which side of the balance sheet will loan come? It will come in the liability side of the balance sheet. Very good. But for bank, now we are in bank audit. Now you all tell me which side of the balance sheet will it come for bank audit? The advances will come in the asset side of the balance sheet. Yes. So in the starting itself, I'm telling you how important this advances is, because advances is something which is given by the bank. So the bank has to get it from you. So it is an asset for the bank. It is like a debtor. Yes or no? So like an asset for the bank. So keep that in mind also when we go there. Don't worry, again I will remind you when we go there. For now, let us focus on types of banks in India. Commercial bank, cooperative bank, development banks, regional rural bank, payment bank, and small finance banks. What is the meaning of commercial bank? Commercial bank is one of the most common banks. Here, two of the main functions of commercial bankers, they are going to accept the deposits and they are going to grant the loans. The loans are the advances. What is regional rural bank, RRB? For example, Punjab Grameen Bank, Tripura Grameen Bank, in the villages, for the villages they are set up. They are set up in rural areas in different states. What is cooperative bank? They are set up on the basis of cooperative principles and registered under Cooperative Societies Act of the state or Multi-State Cooperative Societies Act and cater to agricultural or rural sectors. That is your cooperative bank. Example is also given. Gujarat State Cooperative Bank, Chhattisgarh Rajya Sahakari Bank, Mayardit, etc. All of these are cooperative bank. What is payments bank? So usually what does bank do? The function of the bank is to accept the deposits and to grant the loan. For payment bank, they will only accept deposits, no granting of loan, one-sided relationship. That is called as payment bank. Say for example, Paytm Payments Bank. What does Paytm do? Only wallet facility is provided to you. Is Paytm giving any loans? Airtel Payment Banks, it is a wallet where you can give the money to them and they will hold it as digital currency. Yes or no? So all these are accepting deposits, but they are not granting the loan. They are no new type of banks which has been recently introduced by RBI, where customers can open current and savings account. They have facility of ATM, debit card, internet banking, mobile banking, all of those things. But what they cannot do, they cannot issue loans. They cannot issue credit cards. What is the meaning of development bank? Development bank is basically for the development of a particular sector. So if you see, to develop an infrastructural facility, they will be giving funds for a development bank. Now, if I have to give you an example of development bank, the best is SIDB, that is Small Industries Development Bank of India, IDBI, Industrial Development Bank of India. So all of these are just development banks. What is small finance bank? Basically for unorganized sectors, they will be giving the money. This is also set up by RBI to make available the basic banking facilities to unserved and unorganized sectors. Say small and micro business, small marginal farmers, all of them have the Equitas Small Finance Bank. You would have heard of that name. That is the small finance bank, development bank, payment bank, cooperative bank, regional rural bank, and commercial bank. These are the types of banks which are present right now in India. What is the functions of RBI? The RBI is responsible for what? Development and supervision of the constituents of the Indian financial system, which comprises of banks and non-banking financial institutions. That means RBI is not only for the bank. We keep studying RBI is bankers bank. We love that word. Yes, we heard it somewhere in 11th, 12th, and it's just stuck with all of us. Bankers, RBI. Now, RBI is responsible for not only the banks, but the entire financial system of India itself. And RBI is the one who's going to give the monetary policies and all of those things to the government. They are regulating the activities of the commercial bank and all the other banks, and they will be making the credit policy and monetary policy. What are the functions of RBI? It is the issuance of currency, basically the notes, how much money should be there in the economy. RBI will going to regulate that, regulation of the currency issue. They are going to act as banker to the government, and they are acting as the banker to the bank also. Regulatory framework. There are so many acts that a bank has to follow. Banking Regulation Act 1949, SBI Act 1955, Companies Act 2013, Banking Companies Acquisition and Transfer of Undertakings Act 1970. There is also Banking Companies Acquisition and Transfer of Undertakings Act 1980. Then is RRB Act 1976, IT Act 2000, TMLA Act 2002, that is Prevention of Money Laundering Act, SURFACE Act, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002, Credit Information Companies Regulation Act 2005, Payment and Settlement Systems Act 2007. All these acts is the regulatory framework for a bank. What are the peculiarities involved? Large volume and complexity of transaction, wide geographical spread. Yes, if you see HDFC, ICICI, Indian Bank, everywhere in so many states, in each state, in so many cities, in each city, in so many places. So geographical spread is so high. Large range of products, extensive use of technology. Yes, nowadays everything is the click of a button. You can get a loan, you can transfer funds, everything by use of technology only. Strict vigilance by banking regulator. All these are peculiarities which are involved. For bank audit, what should be the approach? There are 3 points that you have to remember. The first one is drawing an audit plan. The second, how should the control environment be at the bank? And third is the discussions between the engagement team. Now, how will you draw the audit plan? It is going to be based on nature and level of operations, nature of adverse features, level of complaints based on previous reports, and if there are any audit risk, you're going to consider these 4, and then you're going to make your audit plan. How the control environment at the bank will be. A bank should have appropriate control to mitigate the risk. For that, you have to ask all these questions. Who, what, why, when, where, how. Who performs the control? Does this person have knowledge and authority to perform the control? What evidence is available to demonstrate or prove that the control has actually been performed? When and with what frequency the control has been performed? Is the frequency enough to prevent, detect and correct a material misstatement? Where is the evidence of performance of the control? For how long is the evidence retained? Is the evidence accessible or available for audit? Why is the control being performed? What types of errors are prevented or detected? How is the control performed? What are the control activities? Can these activities be bypassed? Can the bypass, if any, be detected? How are the exceptions or deviations resolved on identification? All these are the questions for what? To see the control environment, whether it is appropriate to mitigate the risk that is coming for the bank. How should the engagement team discussion be? The discussion, this should be done at the planning stage of audit, and it should include the errors that may occur. Errors from prior periods. How is the fraud being perpetrated by the bank personnel? Audit responses to the engagement risk, whether it is pervasive and specific risk. Need to maintain the professional skepticism, need to alert for information or other conditions. All of these are engagement team discussion. Why should they have the discussion? Is the advantages of such a discussion. This is advantageous because specific emphasizes to the susceptibility of the misstatement due to fraud arises. Engagement partner delegates the work to the experienced engagement team members and determines the procedures to be followed when fraud is identified. That is the reason why discussion is helpful, because it will help to identify the fraud, for which the engagement partner will be delegating the work to the engagement team members to identify the fraud. Engagement partner will review the need to involve specialists to address the issue relating to fraud. That also the discussion is going to tell whether specialist is required or not. So where were we? We were under bank audit approach. There were 3 points. Drawing an audit plan is based on how is the control environment, and the third is engagement team discussion. A follow-on for that engagement team discussion is only advantages of that discussion. Form and content of financial statements. Form A, Form B is there. Form A is for balance sheet, Form B is for P&L. Appointment of auditor, it's the same for banking company. The shareholders will be appointing at the AGM. For nationalized bank, it happens through board of directors. For regional rural bank, it's a rural bank, right? So the approval must be there of the central government. Remuneration of the auditor for banking company, same as Companies Act only, in accordance with section 142 of the Companies Act. For nationalized bank and SBI, it is fixed by RBI in consultation with the central government. Is that clear? That is the remuneration. What is the powers? They have the same powers of the company auditors. Clear? Very, very clear till here. We started off with what are the functions of the bank? What are the types of the bank? RBI's responsibilities and RBI's functions. How is the regulatory framework and what are the peculiarities involved in general for a bank? How should the bank audit approach be? The 3 points plus advantage for the third point. Form and content of financial statements, Form A, Form B. Appointment of the auditor for banking company, it's the same. For nationalized bank, it's through board of directors. For regional rural banks, with approval of central government. Remuneration of auditor for banking company, it's the same, section 142, and nationalized bank and SBI is fixed by RBI in consultation with central government. For remuneration of auditor, I said it's the same. That is for banking companies, the same. For nationalized bank and SBI, it's fixed by RBI. For powers of the auditor, it's the same powers of the company auditor also. Then next comes auditor's report. What is this auditor's report? Now we are here, guys. Already we are done with 8 Roman numbers. If you have noticed, how many of you all noticed that? We are at the auditor's report. In the case of a nationalized bank, auditor is required to make a report to the central government in which he has to state the following. First of all, I want to stop you here. For a nationalized bank, where should you make the report? To the central government. Basically, whoever is making the appointment is to whom you will be making the report to. Yes, nationalized bank, who is appointing the auditor? The board of directors is appointing the auditor. Here, the auditor is required to make a report to the central government. You all should have a thought in your head. How, ma'am, why should the report be made to the central government? For a nationalized bank, when the board of directors are making the appointment, it is a bank. Correct? It is a bank. The same rule as to how we had for company cannot be applied here. That is the reason why the auditor will be making the report to the central government in which he has to state the following. Whether in his opinion the financial statements present a true and fair view, whether the transactions at the bank, whatever it is made, it is within the power of the bank, whether or not the returns from branches have been found adequate, or any other matter which has to be told to the central government has to be told. Now, all these points are for auditor's report. What is long form audit report? The long form audit report is a type of an audit report which has to be given every single year on 30th of June. This is for terms of appointment of auditor of public sector, bank, private sector, bank and foreign banks, as well as their branches, require the auditor to furnish a long form audit report. The matters which our banks require their auditors to deal with have been specified by RBI. What is the date? 30th June every year. To ensure timely submission of long form audit report, proper planning for completion is required. While the format of long form audit report does not require an executive summary, members may consider providing the executing summary to bring out the key observation from the whole document. Is that clear? Now comes reporting to RBI. RBI issued a circular regarding implementation of recommendation of committee on legal aspects of bank frauds applicable to all scheduled commercial bank excluding regional rural banks. Regarding liability of accounting and auditing professionals, said circular provided as under. This is a circular, so it's important. If an accounting professional, whether in the course of internal or external audit or in process of institutional audit, finds anything susceptible to fraud, any fraudulent activity he has found, or if he has smelled any foul play, he should refer to the matter to the regulator. Any deliberate failure on the part of the auditor should render himself liable for action. If you don't tell the regulator, then you will be liable for action. Member shall report the kind of matter stated and circulated to RBI. So this is for all scheduled commercial banks, but this is not applicable for what? Not applicable for regional rural banks. Is that clear? Auditor should also consider the provisions of SA 250. What is SA 250? Consideration of laws and regulations on audit of financial statements. You don't have the standard, but you just have to know the name and number. SA 240, again, you don't have the standard. You just have to remember the name and number because it's given in ICA. SA 240 is auditor's responsibility relating to fraud in an audit of financial statements. Now I'm coming to types of audit reports to be issued generally. Presently, the statutory central auditors have to furnish the following reports in addition to main report. Report on adequacy and operating effectiveness of IC over FR in case of banks which are registered as companies under the Companies Act in terms of section 143(3)(1) of the Companies Act. Long form audit report. Report on SLR requirements. What is the meaning of SLR requirements? Statutory liquid ratio. I know you are thinking that only. That is not what I'm asking. I asked what is the meaning of SLR. It is a percentage of net demand and time liabilities. It is a percentage of net demand and time liabilities. For what purpose? For liquidity purpose. This has to be kept with the bank itself. The statutory liquid ratio has to be kept with the bank itself. What is the other ratio? Cash reserve ratio. That has to be kept with the Reserve Bank. Yes. Now this SLR requirement is a percentage of net demand and time liability. What is the meaning of net demand and time liabilities? So basically on time something becomes liable. What is liability for a bank? The liability for a bank is the deposits that they are collecting from people because they have to give it back. Yes or no? Now, when I have to give it back at a certain date, I need that cash in my hand to give it back. Basically, what is the function of bank is I get the deposits and I give the loans. Now, I have gotten the deposits, I have given the loan. Now, it's time for me to repay the deposits. I should have the money with me for me to repay the deposits. That means I should have the liquidity with me. So there is a rule that a percentage of net demand and time liabilities has to be kept with the bank itself for liquidity purposes. And that is time liability. I told you. What is demand liability? Sometimes you give the loan and then you ask them back on demand. Like that, people will ask you money on demand. So net demand and time liabilities both has to be factored, and a percentage of that should be kept with the bank themselves for liquidity purposes. That is your statutory liquid ratio. Now, whether the bank has maintained SLR requirements properly, the compliance with SLR requirements, whether it has been proper, you please mention or have a separate audit report. Usually, how many audit reports will be there, guys? There will be one audit report. Here, already you studied about 3 audit reports: IC over FR report, long form audit report, SLR requirements report. The fourth one is report on whether the treasury operations of the bank have been conducted in accordance with instructions issued by RBI from time to time. Report on whether income recognition, asset classification and provisioning has been done as per RBI guidelines only. What are the 3 things? Income recognition, asset classification and provisioning, whether it has been done as per RBI guidelines. Report on whether there is a serious irregularity. Report on Ghosh committee and Gilani committee. Ghosh committee is for fraud and malpractices. Gilani committee is for internal control and inspection or credit system. Report on adverse credit deposit ratio, specifically in rural areas. Now there are 8 kinds of reports that has to be given. Generally, types of audit reports. Now when you go for bank audit, are you happy? No, you are looking at this and thinking, ma'am, so much to study. Now when you go for audit, you know what you will feel like? Oh, so much work is there, so I can charge more fees. Like that you will be feeling. So what are the types of audit reports that you will be giving when you go for audit? You can give IC over FR report, long form audit report, SLR requirements compliance report, treasury operations, whether it has been conducted properly, that has to be a separate report, whether everything is as per RBI guidelines, only income recognition, asset classification and provisioning. If there any serious irregularity, you please mention that also in a separate report. Gosh committee, Gilani committee, separate report. Adverse credit deposit ratio, specifically in rural areas, give me in a separate report. Now the last one, why did they ask for adverse credit deposit ratio specifically in rural areas? What is the meaning of adverse credit deposit ratio? Does anybody know that? What is the meaning of credit deposit ratio? Let's come to adverse later. What is the meaning of credit deposit ratio? Say for example, I have 100 rupees as deposit. I am giving 70 rupees for credit. So my credit deposit ratio becomes 7:10. Yes, or 10:7. However you want, you say. Yes, 10:7 is my credit is to deposits. Yes or no? Now, why are they saying give me a report specifically for adversity? Adversity with respect to credit deposit ratio, that also only for rural areas. Why? Because you all tell me, as a bank, when I function, I see the bank as an overall bank. I am going to accept the deposit and I am going to give the loan. From whom will I accept the deposits? From people who have money. Who has more money? The rural areas have more money or urban areas have more money? The urban areas definitely have more money. So the money which is incoming for you, okay, hold on guys. The money which is incoming for you is going to be from whom? Not from rural, it is going to be from urban areas. Now, who need more loans? You tell me who need more of loans. Now, if you see volume wise, urban areas will need more loans, but in rural areas, they are not depositing and they are only taking the money as loans. Now, what is happening here? Deposit will be 10 rupees, loan is 100 rupees. Is there a possibility in this place? Only when I look at rural areas. So in rural areas, automatically my credit deposit ratio is going to be adverse. Yes or no? Because here, what is going to be the ratio? The loan is 100, deposit is 10. It is going to be 10:1. It is a adverse credit deposit ratio. That is the reason why specifically in rural areas they have asked and they've left out the urban areas, because there they also give deposits, they also take the loans. But in most of the cases, the banks will be getting the deposits from urban areas and they will be giving to rural areas and urban areas. So specific to geographically rural areas, please tell me what is the credit deposit ratio. If it is adverse, you please give it to me in a separate report. So those are the 8 types of audit reports which is to be issued generally. The next one is, how should you conduct an audit? Now, when you see this part, conducting an audit, it is starting off from initial consideration by the statutory auditor and then identifying and assessing the ROM, understanding the bank and the environment, understanding the bank's accounting process, understanding the risk management process, engagement team discussion, establishing overall audit strategy, developing the audit plan, audit planning memorandum, determining audit materiality, consider the going concern, assess the risk of fraud including money laundering, assess specific risk associated with outsourcing, response to assess risk, stress testing, Basel III framework, reliance on review of other reports. Now there are 18 points here. How many points? 18 points. The first one is initial consideration by statutory auditor. Nothing to get scared. Don't get scared by just looking at the headings. Inside will be easy. I always tell that. If something looks big, when you actually go inside, it will become very easy. Trust me on that. The first point is initial consideration by the statutory auditor. And also, if you see, we are almost in the fag end of our first part. In the first part, the last is conducting an audit, and after that, we'll be moving ahead with the second part. So don't worry, just follow whatever I am saying. The first point is initial consideration by the statutory auditor. What is the meaning of initial consideration by statutory auditor? Before I get into an audit, so basically I'm conducting an audit. Before I get into an audit, what should I be considering? That is the initial consideration by statutory auditor. Under that, there is declaration of indebtedness, internal assignment in bank by statutory auditor, planning, communication with previous auditor, terms of audit engagement, initial engagement, assessment of engagement risk, establishment of team, understanding the bank and environment. Now, if you ask me, those 18 points, yes, it is important. But the first point, it is extremely important because under the first point, there are 9 different points. So there is a possibility that ICA can ask a question when you're going and conducting an audit. What are the initial considerations that you have to consider? If they ask like that, then you will be writing these 9 points. What are the 9 points? Initial consideration by the statutory auditor. The first one is declaration of indebtedness. What is the meaning of declaration of indebtedness? RBI has advised before appointing statutory central or branch auditor, then he should obtain a declaration of indebtedness. That means I do not owe any money to the bank. That is the first consideration that you have to have. Second, internal assignment in bank by statutory auditor. The audit firm should not undertake any statutory audit assignment while associated with internal assignment during the same year. Say for example, you are only doing the internal audit. You yourself cannot be appointed as the statutory audit. What was the first point? Declaration of indebtedness. Second, you cannot undertake any internal assignments if you are getting appointed as the statutory auditor. Third, SA 300 planning. What is planning requiring the auditor? The SA 300 requires the auditor shall undertake the following activities prior to starting the initial audit. What is that? SA 220. What is it saying? Performing procedures regarding SA 220 with respect to acceptance of the client relationship. Establish understanding of terms of engagement as per SA 210. That is your SA 300 planning. So basically under SA 300 planning, if you see, they're talking about 220 and 210. Communication with the previous auditor. Basically what you have to do when you are getting this audit, you have to go to the previous auditor and you go and ask him, sir, do you have any problem if I'm going to do this audit? He is going to say, no sir, I do not have any objection. That is called as no objection certificate, has to be gotten from the previous auditor for you to conduct the audit. Terms of audit engagement. Agree on the terms of audit engagement before beginning field work. You first agree on the terms. Again, they're talking about which standard. Where do you agree on the terms? Standard SA 210. Initial engagement. Perform audit procedures as mentioned in SA 510. You know what happens in 510. Assessment of engagement risk. Where do you assess the risk as part of SA 315? You are going to assess the risk. Establish the engagement team members. Understanding the bank and its environment. Identifying and assessing the risk of mental misstatement through understanding the entity and its environment you would have studied. That is which standard? Understanding the bank and its environment is SA 315. So what I'm trying to tell you is initial consideration by the statutory auditor. Whenever I say initial consideration by statutory auditor, the first thing that has to come to your mind is declaration of indebtedness. Whether I have any internal assignment, SA 300, under SA 300, reference to SA 210 and 220, communication with previous auditor, that is no objection certificate, terms of audit engagement, that is SA 210, initial engagement, that is SA 510 and SA 315 points. If you write all of this, then that initial consideration by statutory auditor itself gets completed. Like I told you, the first point out of all the other points in conducting an audit is important because under the point they have multiple points, correct, sub points, so which makes it that there is a possible question here which ICI can make, and definitely students will be like, oh, what is this, where did we study? Because bank audit itself means people will think about appointment, people will think about advances, people will think about audit of expenses, but not many people will give importance here. That means ICI can ask this question. That is the first one, guys. Trust me, all the other ones are easy. All the other 18 points are easy. I will also tell you how to study the remaining points. Now, the second point is identifying and assessing the ROM. Where will you identify and assess the ROM? In SA 315. Please write it next to that itself. SA 315. Understanding the bank and its environment. Where will you do it? SA 315. Understanding the bank's accounting process. Again, 315. Understanding the risk management process. Under understanding the risk management process, they're talking about control activity, monitoring system, identification, measurement and monitoring of risk, oversight and involvement of those charged with governance, and information systems. Engagement teams discussions, establish the overall audit strategy, develop an audit plan, audit planning memorandum, determine audit materiality, consider, going concern is which standard? 570. Assessing the risk of fraud, SA 240. Just now you read the name and number of the standard. Assessing the risk, that is 315. Risk associating with outsourcing of activity. Response to the assessed risk, 330. Stress testing, Basel III framework, reliance on or review of the other reports. Now, out of 18 points, how many are just standard names and numbers? You tell me. 2 is gone, 3 is gone, 4 is gone. 5 is gone, 6. Engagement team discussion. Overall audit strategy, audit plan 300, planning memorandum 300, materiality 320, going concern 570. Fraud, including money laundering, is 240. Assessing the risk, this is a new one, risk associated with outsourcing of activities. Next, stress testing, Basel III framework and reliance on review of other reports. These three are new. What is the meaning of stress testing? Say for example, I buy a phone. When this phone, when they sell it, they say it is 128 GB or 256 GB or whatever. I want to know whether this phone is really 256 GB. So what I will do, I will dump all the information on this phone until 250 GB and see whether I'm able to operate the phone as desired. Basically, I'm putting the phone under stress to see whether it is actually operating as desired. Stress testing is basically a software testing activity that determines the robustness of the software by testing beyond the limits of normal operations. Stress testing is important for mission critical software, and RBI requires that all commercial banks shall put in a place a board approved stress testing framework. What is Basel III framework? International banking regulations issued by BCBS, that is Basel Committee on Banking Supervision. They have told some, and Financial Stability Board, that is FSB, they have undertaken an extensive review of the regulatory framework in the wake of subprime crisis. That is your Basel III framework. Like how your stress testing spoke about how you have to stress your software and keep on testing to check the robustness of that software. The Basel III framework is by BCBS and FSB. And you should also see the reliance on review of the other reports. What are the other reports? They should check the adverse comments. Adverse means any negative comments if it has come on the advances appearing in the following. You will be seeing the previous year report, latest internal inspection report of the bank officials, Reserve Bank's latest inspection report, verification of security. For that, if there is a report, then you will have to refer to that also. Any other internal report specifically related to the particular accounts or manager's charge handing over report when the encumbrance is changed. So all these reports, if there is a reliance, then you will have to review that report also. So all the 18 points together, you are going to call that as what? When you're conducting an audit, you will be getting through all these 18 points. Like I said, the first one is the most important one. That is the initial consideration by the statutory auditor. Now I'm moving ahead to the second part. The second part spoke about advances. Now what is advances, guys? Does it come in asset side or liability side of the balance sheet? Advances in general is going to come in your liability side of the balance sheet. But because we are doing bank audit right now, the banks are the ones who are giving the loan. So they have to get the loan back. That means there is a debit balance. That means it comes in the asset side of the balance sheet. Now, keeping that in mind, what are all the advances? Advances could be your term loan. Term loan, the name itself specifies saying after a specific time period, you have to pay the loan back. That is the term loan. After a specific term, you have to pay the loan back. What is the meaning of cash credit, overdraft facility and demand loan? First of all, since we saw term loan, you tell me what is demand loan. Demand loan is on demand loan. That means usually between friends, what happens? I will give you the money and later whenever I want, I will take it from you, macha. You will be able to say that, yes. That means what? There is some kind of an understanding between these two people that whenever I want, I will ask the other person money back and they will give the money. That is called as demand loan. What is overdraft facility? Overdraft facility is basically a person having fixed deposit, but he does not want to break that fixed deposit to take the money because obvious reasons. Interest keeps on coming from fixed deposits, and also if you break the fixed deposit, there will be pre-closure charges and all of those things. So he doesn't want to disturb the fixed deposit, but he still wants money. What he will tell the bank, see here, I have FD in your bank only. This itself is going to act as a security for you. Keeping this as the collateral, give me a overdraft facility. What is the most important thing in the overdraft facility is the interest calculation. Usually, if the overdraft facility is given for say 50 lakhs, interest will not be calculated at the entire 50 lakhs. Interest will be calculated only for the specific usage that you have done. That means if the bank is sanctioning 50 lakhs, that does not mean like term loan, like how it is hitting your bank account. Nothing like that is going to come inside. 50 lakhs of balance will what is given to you. If you take 2 lakhs, then you pay interest only on the 2 lakhs. If you take 10 lakhs, then you pay interest only on the 10 lakhs. That is your overdraft facility. What is the meaning of cash credit facility? Cash credit facility is basically, I need money for my current. That means I have stock in hand. I am unable to sell the stock in hand. In that case, I will give my inventory as the collateral and get the money from the bank. So for my working capital requirements, if I'm going to take money, keeping my inventory as the collateral, that is called as cash credit facility. The next one is bills discounted and purchased. What is the meaning of bills discounted and purchased? Say for example, Roshan and Kirti are getting into a transaction. Now, Kirti has to pay Roshan 5 lakh rupees after 3 months. After 3 months, Kirti has to pay Roshan how much? 5 lakh rupees. But Roshan is in need of funds immediately. So what Roshan is going to do is he is going to go to the banker and he is going to say, see here, I have a bill, I have an invoice for 5 lakhs, which is signed by the other party. That means that she has accepted to give this 5 lakhs after 3 month period. So this is the collateral. The invoice becomes the collateral, and based on this, the banker is going to give money to Roshan. How much money will the banker give Roshan? Will banker give the entire 5 lakhs to Roshan just because he asked it? No. The banker will give 4.5 lakhs. Because the risk lies with the banker right now. Whether Kirti will give the money or not to the bank, don't know. The banker is assuming the risk. So for that risk, banker needs to get a reward. The reward is the 50,000 profit that the bank is going to make because the bank is discounting the bill and they are getting, that is called as bills discounted and purchased. I am purchasing the bill from Roshan for an amount of 4,50,000 here. That is the concept of bills discounted and purchased. What is the meaning of participation on risk sharing basis? So usually when people go to a bank and get a loan, it will be 1-to-1. One bank is giving the loan to another person. But in huge industries, what happens is one bank do not want to assume the entire risk. So this bank goes to multiple other banks and they form a consortium and four other banks give loans to one industry. Are you able to understand? So in that case, every bank is participating here and they are sharing the risk. That is called as participation on risk sharing basis. Interest bearing staff loan. Say a banker can also give loans to the employees of the bank. In that case also the employees have to give the money back because it's a loan. So that also comes in the asset side of the balance sheet of the bank. So all of these together we call that as advances. All the five together: term loan, cash credit, overdraft, demand loan, bills, discount and purchase, participation on risk sharing basis, and interest bearing staff loans. So there are few rules that you have to follow. That is how you're going to classify your advances. You will be classifying your advances sector wise, security wise, and then we'll go to prudential norms on income recognition, asset classification, and the provision. For now, let's only focus on sector wise. Sector wise is extremely simple, guys. You only split into priority sector and non-priority sector. What is the meaning of priority? Healthcare, education, agriculture, MSME, housing, all of these come under priority sector. I want to build my house. I want to build a commercial property for which I'm going to the bank. That is a non-priority sector. Is that clear? So classification of advances, the first step I told you is sector wise. Under that, I'm going to split into priority sector and non-priority sector. The second type of classification is the security wise. Banks are going to ask security or collateral when they are lending. So it could be a primary security or a collateral security. What is a primary security? This is a security which is offered by the borrower for bank finance or the one against which the credit has been extended by the bank. This security is the principal security for an advance. Collateral security is the additional security. This additional security could be tangible or an intangible asset, movable or immovable asset. Is that clear? Now you all will have the doubt as to what is this collateral security, what is this additional security, and all of those things. Say for example, a person wants to buy a car. When he is buying a car, the value of the car is 50 lakhs. Yes, the value of the car is 50 lakhs for which the loan is granted for 40 lakhs. 10 lakhs down payment he has paid by his own money. 40 lakhs loan is given for a value of 50 lakhs car. What is the security in this loan, you tell me? Automatically the car becomes the primary security. But you tell me, now after 5 years, say this person does not pay, what happens to the value of the car? Will it still be at 40 lakhs? It could be at 30 or it could be at 20, it could be at 0 also. Say for example, in 6 months the car has gone to an accident and no value of that car could be actually gotten for the bank. Then in that case, the banker is extra shrewd. So when they give the loan itself, they are going to say, okay boss, your primary security is going to be the car, but I also need an additional security. Do you have a warehouse or some small land or something like that worth 20-30 lakhs? You give me an additional security that I'm going to consider as a collateral security. Now are you able to understand what is the primary security and what is the collateral security? Most common types of securities which are accepted by the bank: personal security of guarantor, goods, stock, debtors, trade receivable, gold ornaments and bullions, third party guarantees, banks general lien, life insurance policy, stock exchange securities, all of these can be securities. Mode of creation of securities. Now, you would have heard these terminologies like mortgage, pledge, hypothecation, assignment, lien, and you would have used it hand in hand. That means you will not know the difference between these things. Now just be with me. The first one is mortgage. What is the meaning of mortgage? All of these are collaterals, yes or no? All of these are talking about security only. No doubt about that. Now I'm talking only about mortgage. Yes, what is mortgage? Mortgage is generally done for an immovable property. Don't mind those lines. Immovable property. The possession is going to be for the borrower. If I simply tell like this, you will not understand. The example is going to make the world of difference. You can mortgage a house. Is house a immovable property? Yes. Who is going to have the house after the mortgage? Person who got the money, that is the borrower, is going to have the house even after the mortgage. Now coming to the concept of pledge. Pledge is for movable property and the possession will be with the lender. Now, the example is going to be the game changer. As always, the example for pledge is gold. Is it a movable property? Who is going to have the gold? The person who's giving the money. You are going to give the gold, that is pledge the gold, and then you're going to take the money. The lender is going to keep the gold, that is the possession is with the lender. The third one is hypothecation. What is the meaning of hypothecation? This is also for a movable property, but the possession is going to be with the borrower. Now, like I said, the example is going to make a world of difference. You can hypothecate a car. Is it a movable property? Yes. Who is going to have the car? The person who still has the money is going to have the car. That is a borrower is going to have the car. That is the difference between mortgage, pledge and hypothecation. Is that clear? Now the last one is lien. What is the meaning of lien? It could be anything. It could be movable, it could be immovable, it could be anything. But here there is a creditor involved. That means you have to pay something to the other person and they have given you goods. Now coming to the text. Mortgage are of several kinds. Now, what is the example for mortgage? House. But the most important one is registered mortgage and equitable mortgage. Registered mortgage, it has a registered instrument called as mortgage deed. Equitable mortgage is mere delivery of title deeds or other documents of title with intent to create the security. Pledge. Pledging is what? Pledging the gold, movable property and possession is of the lender. It involves bailment or delivery of goods by the borrower to the lending bank with an intention of creating a charge. The legal ownership remains with the pledger only while the lending bank gets defined interest in the goods. Pledge of goods constitutes a specific or fixed charge. What is hypothecation? Hypothecation example was a car. Now that is a movable security, but the possession is with the borrower. Now see, for hypothecation, it's creation of an equitable charge which is created in favor of lending bank by execution of hypothecation agreement. The borrower holds the physical possession. The borrower periodically submits statements regarding quantity and value of hypothecated asset. Lien is creation of a legal charge with consent of owner which gives the lender a legal right to seize and dispose or liquidate the asset under lien. What is assignment? Assignment is basically transfer of an existing debt or a future debt or a transfer of a right or property belonging to one person in favor of another person. I am assigning to another person. For example, actionable claims where life insurance policies which are accepted by bank as security by way of assignment. And assignment gives the assignee the absolute right over the money or debt which is assigned to him. Set off is a statutory right of a creditor to adjust wholly or partly the debit balance in the debtor's account against any credit balance in any other account of the debtor. Set off you already know. Yes, now you have learnt 6 new things here. I'm sure this would have blown your mind. Mortgage, pledge, hypothecation and lien, where you thought mortgage is equal to pledge is equal to hypothecation is equal to lien. You thought like that, but I have proved to you that it is not the case at all. They are completely different and they are completely different terminologies having different meanings. I hope at least in the future, you will not be using as if they are synonymous with each other. Now going to the prudential norms on income recognition, asset classification and provisioning. Now, the RBI says that you have to classify your advances. The first classification should be done as standard loans and non-performing assets. What is standard loan? Standard loan can be standard regular or SMA, that is special mention accounts. SMA again is classified into SMA 0, SMA 1 and SMA 2. Till here we don't have any problem because until SMA we are only seeing that an account is showing stress signals. That means it has been due but still they have not been paid. That means it is due till 90 days. then we don't have any issues. But once the due is above 90 days is when we go to category of NPA. Are you able to understand? Say for example, the bank has given the loan and the due date of that loan has come and 90 days has passed, and then you come to NPA loans. Until 90 days, you are going to call it what? Standard only. Under standard, it could be an SMA or standard regular. Standard regular means not even fallen due. SMA means it has fallen due but within 90 days. Within 30 days, you're going to say SMA 0, 31 to 60 days SMA 1, and 61 to 90 days SMA 2. And after 90 days, you're going to call that non-performing asset. Under non-performing asset, you're going to classify that as substandard, doubtful, and loss asset. Under doubtful, again, there is D1, D2, and D3. How should the provisioning be for each? For substandard asset, that means it has remained NPA for a period less than or equal to 12 months. Now, after 90 days, it is sitting in the non-performing asset category for 1 year. After 90 days has been crossed, 1 year has also been crossed, then you are going to call something as substandard asset. Then you create a provision of 15%. Is that clear? Basically, what I'm trying to tell you is, say due is on, now with these lines it's going to be difficult. Wait. Now the due is on what date? Say 21st of June. Say plus 90 days is going to be June to July, July to August, August to September. I am going to keep 21st of September 2025. For these 90 days, I am going to call this as what? Plus 90 days, I'm going to call this as stress SMA account. Now, after 21st September, for 12 months, if they're falling in the NPA category, that is 21st September 2026 onwards, I'm going to call that as a substandard asset. So, after 21st September 2026, I'm going to create a provision of 15% because now they are in the substandard asset category. Is that clear? Now I'm moving on to the next one, that is doubtful asset category. Doubtful asset means which has remained in the substandard category for a period of 12 months. Now from 21st September 2026, it is in the substandard category till 21st September 2027 onwards, I'm going to call that as doubtful asset. So after 21st September 2027, I will see whether they are in D1, D2 or D3. Now they are in the doubtful category up to 1 year. Doubtful up to 1 year. Now they are entering the doubtful category when 21st September 2027. So before 21st September 2028, I will call that as D1. Doubtful 1 to 3 years. Before 21st September 2030, I will call that as D2, that is 28 to 2030. Year 28 to 2030, I am going to call that as D2. Doubtful more than 3 years, that is after 21st September 2030, I am going to call that as D3. Loss asset will be one where loss has been identified by the bank, and if they want to write it off completely, you will be provisioning for 100%. I hope you are clear with the dates. If not, I want you to write it down and calculate it yourself, and only then you are going to get the full clarity. Just write on one side due. Due is, how much is the, when is it due? 21st September 2025. Sorry, 21st June 2025 was the due. Now with these lines, it's difficult for me. Please write it down. Due is 21st June 2025. We are going to wait for 90 days until it is SMA. That becomes 21st September 2025. Now write one line here. After 21st September 2025, it falls in the what category? It falls in the NPA category. Now here, coming to the NPA category, it has to be either substandard, doubtful or loss. For the first 1 year, after the first 1 year, you're going to call that as substandard asset. So here, after first 1 year, that is after 21st September 2026, you will be calling that as substandard asset until 21st September 2027. Isn't that what I've written here? Now after Doubtful asset is what? It has been in the substandard category for a period of 12 months. So 1 year it has to be in the substandard category and then it becomes doubtful asset. So from 21st September 2027 to 21st September 2028, it will be in the doubtful asset category. Now it has to be in the substandard asset. So from 21st September 2027 to 21st September 2028, it will be in the D1 category. Is that clear? Yes. D2 is doubtful category 1 to 3 years. It has to stay in the doubtful category for 1 to 3 years. That means from 2028, 21st September till 21st September 2030, it will be in the D2 category. And after 21st September 2030, it will be in the D3 category. And after that, it will go to loss asset. Now, once you know whether it is D1, D2, D3 or loss or substandard or standard, wherever, then the provisioning becomes very, very easy. For a substandard asset, the provision required is 15%. For a doubtful asset, if it is D1, the provision is, you will have to see whether it is secured or unsecured. If it is unsecured, more than this, you can't get any money. So full 100% you will have to create a provision. If it is secured, 25% provision. If it is in the D2 category, the secured portion itself becomes bigger. That is 40% provision you have to create. Unsecured, no questions asked, 100% provision. D3 category, it is in the doubtful itself more than 3 years. Full 100, don't even have to see whether it is secured or unsecured, because after this there is no use seeing all of those things. Loss assets 100%. I'll tell you where usually students make the mistake. Please underline it in the concept book. See here, for substandard asset, it has to be remained as NPA for a period less than 12 months. It has to be in the NPA category for 12 months for it to be substandard asset. Yes. But if you see in the doubtful asset category, the doubtful is talking about it has to be remained in the substandard category for a period of 12 months. And for D1, D2, D3, see what is happening. It has to be in the doubtful category up to 1 year. It has to be in the doubtful category for 1 to 3 years. So when you're doing this table itself, I want you to see the timeline and also in the category as to what time it should be. D2 means what? It has to be in the doubtful category for 1 to 3 years. How it will come to the doubtful category? It has to be in the substandard category for 12 months. How it will come to substandard category? It has to be an NPA for 12 months. Like that, if you have the clarity, then the provisioning becomes easy, because this part is easy to remember. 15, 25, 40, 100. That's it. Easy to remember. Secured, unsecured portion. That part, yes, of course. Once you do a sum, there is when you'll get full clarity. But for you to get a clarity here, you have to think of different cases. Take your birthday as the due date. And from there, you find out when you will come to loss asset. Something like that you can do. Do it like a homework. Yes, clear? Because one thing I have showed you, one example I have showed you. After that, I want you to figure it out. Now, next I want to go to advances under consortium. Consortium means what? Multiple people are coming together and they are giving the loan. Consortium means by 2 or more banks joining, by forming a consortium, they are giving the loan. Joint appraisal, joint control, joint monitoring, all of that will happen. Consortium advances should be based on record of recovery, where remittances by the borrower under consortium lending arrangements are pooled with one bank and or where the bank receiving remittances is not parting with the share of other member banks, the account should be treated as not serviced in the books of the other member banks and therefore an NPA. So usually when there is a consortium, there will be one lead bank. There will be one lead bank and all the other member banks will be part of the consortium. What will happen? Say, for example, the lead bank got the money and that money is not given to the member banks. In that case also, in the accounts of the member banks, I didn't get the money. So automatically it becomes doubtful, substandard, or whatever provision you have to create, you have to create. You cannot say client is given the money. How can I put the provision? You didn't receive the money. That is the way you have to look. Is that clear? That is the consortium, guys. The next is drawing power allocation. For that, I want to go to another place. Yes, computation of drawing power. For this, you have to understand sanction limit and then you will understand drawing power automatically. What is the meaning of sanction limit? For example, one person can get term loan, the same person can get cash credit, the same person can get on-demand loan, the same person can get overdraft facility. So there is a possibility he can cheat the bank. Yes. So he will give the same revenue statement in all these places and get different loans. That is the reason why every person is going to have something called as sanction limit, where banks will not give put together all the loans more than this specific amount. That amount is called as sanction limit. Now, I already told you what is the meaning of cash credit facility. What is the meaning of cash credit facility? It is a facility which is given by the bank for working capital requirement, keeping what as collateral? Inventory as collateral. Now, specific for cash credit facility, according to your inventory, this much amount only I will be able to give you. That amount is called as drawing power. Drawing power is specific for cash credit facility. Sanction limit is specific for an individual with respect to all the advances that he can get. Very clear. I have distinguished what is sanction limit and drawing power. Yes, drawing power addressed as DP, important concept for cash credit facility. It is different from sanction limit. Sanction limit is the total exposure that a bank can take. Computation of DP, it needs to be ensured that drawing power is calculated as per the guidelines formulated by Board of Directors. Stock audit has to be done, where the funded exposure is more than 5 crores. Why they're talking about stock audit? Because your collateral is the inventory, is the stock. So whether that stock is really there or not, physical verification of inventory has to be done by the bank. Because the client is saying, I have so much of inventory and they've taken the cash credit facility. So the bank will be doing a stock audit if the funded exposure is more than 5 crore rupees. Branches should obtain the stock audit report from lead bank in cases where bank is not the leader of the consortium or working capital. Is that clear, guys? So this is a computation of drawing power. You take the stock minus unpaid stock, that is the sundry creditors, all of those things. This is the paid for stock. Whatever is the margin, you will be reducing that. This is the true value of the stock. How much is the debtors minus ineligible debtors, whatever margin is there, total debtors. Now this debtors plus your stock is your total drawing power. This question 2 times they have already asked in the exam. I have left few concepts here. I will just quickly cover that also. I don't want to miss out anything. Yes, erosion in the value of the security. So basically, say for example, you're giving a house will not get eroded, land will not get eroded. But if you're giving a machinery as a collateral, or if you're giving a car as a collateral, car is an example we've already taken before. So I will take car itself. So now this car I have given as collateral. Beautiful car, correct? When I gave this car, the car was valued at 50 lakhs. But now the car is valued only at 10 lakhs. There is an erosion in the value of the security. Now there is a problem for the banker, yes or no? So the accounting has to be done this way. The guidelines is saying that if there is an erosion in the value of the security, see the realizable value. If the realizable value is less than 50% of the value which is assessed by the bank, then such NPA may be straight away classified under doubtful category. If the realizable value is less than 10% of the outstanding, then existence of the security should be ignored and asset should be straightforward classified as loss asset. Less than 10% means not even lemons you can buy. So you please show it as loss asset. How much provisioning for loss asset? 100% provisioning for loss asset. If the realizable value is less than 50%, then you put it in the doubtful category. You make a decision whether it is D1, D2, D3 according to when it has become. So you have to see the dates and all of those things. But if the erosion is less than 10%, then automatically to loss asset only you will have to do. That is with respect to erosion in value of security. One more important one which I want to say was about agricultural advances. That is here, agricultural advances. Now, with respect to agricultural advances, you have to remember 2 concepts. One is long duration crops and short duration crops. Okay, this one. Long duration crops and short duration crops. What is the meaning of long duration crops? The long duration crops are the crops which are having season longer than 1 year. And crops which are not long duration crops will be that short duration crops. What is the meaning of season having more than 1 year? Say I put a seed today, I am getting the fruits only after 1 year. It is possible like that. Some trees are like that. You put the seed today, only after 4 years you get the benefit. That is a long duration crop. You put the seed today, in 3 months you are getting the benefit. That is called as short duration crop. A loan granted for short duration crop will be treated as non-performing asset if installment of principal or interest remains overdue for 2 crop seasons. If it is a long duration crop, then you will classify it as an NPA for if it is overdue for more than 1 crop season. To put it very, very simple for you, see here, if it is a long duration crop, okay, basically what is happening, guys, my hand should not touch. So I am writing like this. If I write like this, how my handwriting will be? Okay, long duration crop. That means what? It is the fruits are coming more than 1 year. You will be classifying if it is more than 1 season. Yes or no? Short duration crop. 1 crop season you will see. If it is a short duration crop, that means what? You are getting the fruits within a period of 1 year. Could be 3 months or 6 months or whatever. Here, before classifying as NPA, you are going to wait for 2 crop seasons. More than 2 crop seasons, you are going to classify it as NPA. If the money doesn't come within 2 crop seasons, then he is never going to give the money back to you. Are you able to understand? With respect to this, what is the meaning of crop season and all of those things? Say, for example, in 6 months, if I'm getting the fruit, for 1 year, I'm going to wait because 2 crop seasons. And after 1 year, I'm going to classify it as NPA. Say 3 months, I'm getting the fruit. I'm going to wait for 6 months only because 2 crop season. After 6 months, I'm going to classify that as NPA. Are you able to understand, guys? Yes. That is with respect to agricultural advances. How are you going to audit the advances? Auditing of the advances constitute major part of the assets of the bank. There are large number of borrowers to whom variety of advances are given. In carrying out audit of advances, the auditor is primarily concerned with obtaining evidence about the following. What is it? Advances represent amount due to the bank. Amount included in balance sheet respect to advances which are outstanding at the date of balance sheet. Whatever amount is there, it should be supported by loan documents. There should be no unrecorded advances. The stated basis of valuation of advance is appropriate and properly applied, and recoverability should be as per the valuation. Advances are disclosed, classified, described properly. Appropriate provisions towards advances should be given. Basically, what is advance? How provisioning should be given? All of these things. See, basically, with respect to bank audit, it's more of new things that you are learning. How a bank should function. Where should the bank classify this? Only if you know all of these things, as an auditor, we'll be able to see whether they've done that work properly or not. Yes or no? That is the reason as to why you are seeing whether the bank has done it properly. So for that, you first need to know the rule that the bank has to follow. That is the reason why you are reading how much provision they have to create. If it is a doubtful, what is the percentage? If it is a loss, what is the percentage? For agricultural advance, how should you do? All of these things are flowing from there only. Evaluation of internal control over advances. How should you see the internal control? You know all of these things. The bank should make advance only after seeing the credit worthiness. All necessary documents, sufficient margin should be there. The ownership should be transferred to the name of the bank. It should be registered in the name of the bank. Just read through the points, you will know. Because it's a marathon, I'm not spending much time here. In regular class, fully point by point, I will be explaining. Here, I'm only giving you an overview as to what you can expect out of the bank audit. Now, I'm moving on to audit of income. Recorded income arising from transaction which took place during the relevant period and pertaining to that bank only, and no unrecorded income should be there. RBI has told one thing with respect to the income part. Any income which is more than 1% of total income of the bank, or 1% of the profit before tax, if the income is reckoned net of cost, it should be on accrual basis as per AS 7. What are they talking about? Any income more than 1% of total income, or 1% of profit before tax, if you are reckoning the income net of cost, that only you will be considering on accrual basis. Here also, materiality must be there. Here also, revenue certainty must be there. That means it should be on accrual basis, that is as it is earned and not as it is collected. If revenue uncertainty is there, then you will be classifying that as non-performing assets. Is that clear, guys? Okay. Now I will just talk about the reversal of income. Yes, that is important, because when can you reverse the income? Only in these 5 circumstances for a bank will you be able to reverse an income. If an advance becomes a non-performing asset at the close of any year, the interest accrued and credited to income account in the past period should be reversed. Previously, you kept saying, yes, I'm going to receive the interest, I'm going to receive the interest, even if it was showing stress, you did not give the provision. But once you classify it as NPA, whatever interest you have accrued at that point, you have to reverse it right now. That is the first point. For NPA, whatever fees, commission, or whatever income you have accrued should cease to accrue in the current period, and that has to be reversed. If you have wrongly recognized the income in the past, now you have to reverse it. Auditor should inquire if there are any large debits that have not been explained. Unnecessarily you are given some debit, you have to reverse it right now. Enquire whether there are any communication from borrowers pointing out differences in interest charge and whether appropriate action has been taken. Say, for example, I'm supposed to charge 10%, I charge only 8%. Then what will happen to the 2%? All of those things right now. If you find out anything, you please reverse it. Now I'm going off to audit of expenses. Under audit of expense, there is interest expense, there is operating expense, and there is provisions and contingencies. All the three are same as your company law only. As for a company, how you will do, same way you are going to do here also. Interest expense, you will be doing ratio analysis, you will be seeing the weighted average, you will do the trend analysis, month on month analysis, previous year analysis, average balance. For operating expense, you will see the internal control, substantive analytical procedure, do the trend analysis. For provisions and contingencies, see the complaints, see whether the provisions on standard assets or NPA, substandard, doubtful, loss, non-performing asset, what is the breakup of loan, tax provisions, or any other provisions. If it is there, you have to see. That's it, guys. If you actually see the bank audit, we have completed in no time. Since it's a marathon, I rushed. I know little bit I have rushed here and there, but I hope you understood. See, if you watch it 2 times, at least that advanced part, if you watch it again, you will get full clarity, because in the advance, we are talking about multiple things: agricultural advance, erosion and value of security, drawing power, sanction limit, staff advance, all these things are there. That is the reason why it looked a little elaborate, but if you actually watch it again, only this I'm telling, only bank audit I'm saying, if you actually watch just the second part, that is the advanced part again, you are going to get a better clarity, because just with first time in this speed, it might be a little difficult for you. Now, with respect to bank audit, we started off with types of banks, RBI response. Now all that looks very easy, correct? Very easy. Ma'am, if you just ask, I will tell you. Form and content of financial statement. Form A, balance sheet. Form B, P&L. What, ma'am? Like that you will feel. Appointment of auditor, remuneration, powers of auditor, and then we went to auditor's report. Then types of auditor's report. So many types were there. Usually only one. For bank audit, multiple. Conducting an audit. 18 points are there. But which point I told you is important? The first point. Then we went to advances. Different types of advances. Computation of drawing power. Then audit of income, audit of expenses. Under audit of income, we also saw one more concept called as reversal of income. Yes, guys, that's it with bank audit. I hope you got some confidence that, okay, this much only is there. If I properly study, here also I can get the marks. That confidence is the most important thing, guys, especially when it comes to a chapter like bank audit. All right, guys, I'll see you tomorrow with 300 and all of those things. All right, guys, bye-bye.
You all told we'll finish now. That's the reason. Now, under share capital, what is the mind mapping that we did? Audit procedures, issued at a premium, issued at a discount, sweat equity shares, and reduction. Now, under audit procedures, what are the points that we saw? tally period end share capital balance. Share capital balance with respect to authorized, issued and paid up. If there is no change, then you have to get a written confirmation from the company secretary. If there is a change, then whether it is within the limits of authorized capital, this authorized capital will be given where? If there is, the resolution has to be passed for increasing or reducing the authorized capital. If there is any fresh issue of shares, then the Companies Act has to be complied with. If there is, the shares should not be issued at a discount, the auditor has to check for that. If the shares have been issued for cash or for consideration other than cash, the auditor has to check. Then we have to see SEBI complaints, MCA complaints, Form SH7, Form PAS3 and Form FCGPR for any foreign direct investments. In this form, you will have to verify the number of shares and price. If there is any increase in share capital, how is the fee calculated? Stamp duty which has been paid to MC. Very easy once you see this. Yes or no? Then next we have to go to issued at a premium. You are able to recollect all the points, correct? Issued at a premium. Company shall transfer the premium amount to securities premium account. Then he will have to state the purpose. Restrictions for application of securities premium account. Only for these 5 there are no restrictions. What are these 5? That means securities premium account can be used only for these 5 points. First is issue of unissued shares for fully paid bonus shares, buyback of securities, right of preliminary expense, premium payable on redemption of redeemable preference shares, right of expenses or commission paid or discount allowed on shares. Now for shares issued at a premium, auditor needs to verify only 2 points. One is whether premium has been received and whether the transfer has been done to the securities premium account, and it has been used for only these 5 purposes. Is that clear? Next, going to shares issued at discount. Can you issue shares at discount? No, you should not issue shares at discount, and this has been given under section 53. And shares issued at premium given under section issued at premium given under section? No. No. Sweat equity shares is 54. Discount is 53. Issued at premium is 52. Now, issued at discount. Section 53 of the Companies Act says that you cannot issue shares at a discount, and there are a few exceptions. And if you issue shares at a discount, then it is void. Only one exception is there. That is that first itself they say you cannot issue except for sweat equity shares, but specifically exception is given, that is for a creditor if you are issuing a share under a debt restructuring scheme as per RBI guidelines, then that is an exception. Now, if you do not follow the provisions of this act, then there is a penalty. What is the penalty? Company and every officer in default is liable to a penalty for the amount raised by way of discount on shares or rupees 5 lakhs, whichever is lower, and he is liable to refund all the money that he has received along with an interest of 12% per annum. For this, auditor needs to check only 3 things: movement in share capital, he needs to read the minutes of the meeting, and if the shares have been issued to the creditors as per RBI guidelines, whether it is as per RBI guidelines, he will have to check. Sweat equity shares under section 54 of the Companies Act, where you will be issuing shares at a discount or for consideration other than cash. Here auditor needs to verify special resolution, and in this special resolution it has to specify the number of shares, current market price, consideration, class of director, class of employee. If listed, then the SEBI guidelines has to be seen. Rights, limitations, restrictions, provisions, all of this for the sweat equity shareholders are the same as the equity shareholders also. The last one is the reduction of share capital, where there is accumulated business loss, assets of reduced or doubtful value, or paid up capital in excess of requirement, or surplus capital can't be employed. Now, for the financial health of the company, they will be reducing the capital of the company. Now, if they reduce, definitely they must have a special resolution, and the words "and reduced" must be added to the name. Special resolution, and this has to be authorized in the AOA and MOA, they should not be defaulted for repayment of deposit. If there is any order of tribunal confirming this reduction, you please read the order of the tribunal, see the registrar certificate. Accounting entries reduction, it is actually complicated accounting entry, yes or no? So see whether they have done the accounting entries properly. If there is any revaluation of assets, see that the words and reduced, whether it has been done by the tribunal, and when they are doing it, if there is any terms and conditions which is issued by the tribunal, check that also. This section does not apply for buyback of own securities under section 68. The next is disclosures. You can go through that A, B, C, D, E, F, G, H, I, J, K, L, M. 13 points for the disclosures. Next, where did we go to? Reserves and surplus. That's it. Half a page. Not even half a page. This much only is there of reserves and surplus. Now, for reserves and surplus, what is the mind mapping we did? We first saw what is a reserve, then we went to audit procedures, then we went to disclosures. That's all we saw. Now, what is a reserve? Amount appropriated out of profits, not intended for a liability, not intended for a contingency or a commitment or diminution in value of asset. Now, this is segregated into two. You can either have a revenue reserve or a capital reserve. Revenue reserve means it is available for distribution to the shareholders. Capital reserve means it is not available for distribution. Now, this revenue reserve has a few purposes. Supplement divisible profit during the lean years. During the lean years means what? At times when the company is not making so much of profit, then from the previous revenue reserve I can distribute as dividend. Finance an extension of the business, augment for the working capital and to strengthen the financial position. That means even for marketing expenses also I can use the revenue reserve. Capital reserve means I already told you, that means it is not free for distribution, it is only for a limited purpose. Examples we saw: capital redemption reserve, securities premium, revaluation reserve, debenture redemption reserve. All of these things are examples for capital reserve where they cannot be used freely and for specific purpose only. Under audit procedures, there were only how many assertions we saw? 3 assertions. The first, existence, single point was there where opening balances from the previous year audited financial statements you will be tracing from there. So opening balances and current year reserves and surplus from the previous year audited financial statements you will be getting that. Completeness and valuation assertion, for any addition or utilization you will be seeing the tracing the movements of the P&L balance, tracing the movements of the statement of changes in equity, and the resolution of the board of directors for the recommendation of the dividend. Now, if this dividend has been recommended prior to 31st March, then accounting standard is saying you do not need to recognize as a liability, but if it is declared after the date of balance sheet, but the financial statements have not been approved by the users of the financial statements, you still have to show it as a subsequent event. Then we come to disclosure, classification, CRR, CER, securities premium, DRR, revaluation, so shares option, outstanding account, others, and surplus. Then we saw what is earmarked investments. That means we will call that as fund. Note, balance of reserves and surplus after adjusting negative balance if it comes, loss if it comes also, obviously you will be transferring that loss to the balance sheet under reserves and surplus only. The next is borrowings. What is the mind mapping that we did for borrowings? Audit procedures, auditor to read, and then disclosures. Audit procedures very easy, same 3 assertions: existence, valuation, and completeness. Auditor to read, we saw 13 points were there, and then we went to disclosures. Now, audit procedures, existence, valid claims by bank or third party. I told you directly they will not give you an assertion saying you please write the audit procedures to confirm the existence of borrowings. They are not going to ask questions like that. How are they going to ask? What are the audit procedures for the valid claims by banks or third party? That means you should understand that they are talking about existence of borrowings. Now here, what are the points under existence? For any kind of borrowings, first they will be having a meeting between themselves. Under that meeting, what will they write? Minutes of the meeting. So first, minutes of the meetings, whether they have authorized for the borrowings, whether it is as per loan agreement. You all told me borrowings means the first point you will write is loan agreement you will be writing. Next is Independent confirmation from the direct confirmation you will be getting, that is SA 505 external confirmation. Lease and hire purchase creditor. If there is a debenture trust deed, you will be reading the deed also, similar to that loan agreement. If the debt is retired, then see the discharge whether it has happened on the asset also. What is the meaning of discharge? I told you, if a debt is created, you will be creating a charge on the asset. If a debt is retired, if it is repaid, that means you will be discharging the asset. Next is written representation, you will have to get from the management. The next is completeness. Are they going to say completeness assertion? No, they are going to use the word whether it has been recorded in the books of accounts on a timely basis. That means they are talking about the assertion completeness. Now under this completeness, schedule for short-term and long-term borrowings, you will have to see the minutes of the board of directors, the contracts, confirmation and cash disbursements, trace the closing balance as per the schedule to the general ledger, and subsequent transactions after period end or fresh loan near the balance sheet date, you will be getting the direct confirmation procedure. Direct confirmation procedure, you will be asking for all the information, you will be sending the reminders, and once you get the confirmation, you will be comparing it with the balances in the books of accounts, that is compare the balances. Next is valuation. How many points are there under valuation? Only 5 points are under valuation. First is accounting policies and accounting methods, whether it is appropriate and whether it is consistent. Loan agreement, everywhere you will be writing this point, so whether it is as per the loan agreement. Recomputation of the interest, recomputation of the premium, recomputation of the discount has to be done. Computation of amortization of premium or discount, and if it is any foreign currency loan, AS11, reinstatement of foreign exchange also has to be done. Auditor to read, 13 points are there under borrowings. Under borrowings, 13 points are there. Auditor to read. Read provisions in the agreement. You will be doing a test compliance for all the covenants which is there. Covenants means any rules which has been framed. Rules can be like no fresh loans, no fresh borrowings should be there, or a debt equity ratio of 2:1 has to be maintained by the company. So that is test compliance. If they have not complied with, you have to show as current, because if they have not complied with the rules, that means you are liable to pay that money immediately. So you have to show that as current. Now, if you have not complied and if the third party is okay with your non-compliance, then you have to get a confirmation for the waiver directly from the third party. Those 3 points only are given here. Read provisions in the agreement, test compliance. Non-compliance means you will classify as current. If it is waived means you will get a confirmation from the lender. What are the due dates you will be seeing in the agreement? Proper classification for long term or short term. For a long term borrowing, if the installment which becomes due is less than 12 months, say 1 crore of borrowing, but within 12 months you have to pay 1 lakh. Sorry, 10 lakhs. Then that 10 lakhs has to be shown in the current year. So whether they have shown that correctness, you will have to see. Restrictive covenant, whether there is any restrictions placed in the agreement, you will have to see. Important terms, if there is any statutory requirements for creation of charges, then you will be seeing the registration of charges. If the value of security becomes lesser than the loan outstanding amount, that means there is no guarantee that the company will repay the money, so you will call until the market price of the value of the security as secured borrowings. Apart from that, you will be calling that the unsecured borrowings. To the extent of market value of security only, it is secured loans. Next, you will be reading the hire purchase agreement. If there is any related party loans, AS18, arm's length, those words and all you will be using. If there is any bills discounted, negotiated, whether it has renegotiated, all those things, it has to be disclosed in the financial statements. The borrowing powers has to be as per Articles of Association and Memorandum of Association. Section 180, 185, loans by directors, promoters, all of those things also you will have to see. And any purpose of that loan has to be used for that purpose only. Especially a short-term loan should not be used for long-term purposes as per CARO clause number 9. Accepted deposits should be as per the guidelines of the RBI. This is auditor to read. The last one is the disclosures. Under disclosures, we saw subclassification, secured, unsecured, long-term borrowings, bonds or debentures, term loans by banks, term loans by others, deferred payment liability, deposits, loans and advances from related party, long-term maturities, finance or lease obligations, loans guaranteed by directors or others. If it is guaranteed by directors or others, aggregate amount of such loan, bonds or debentures in the descending order of maturity, redeemed bonds, power to reissue, terms of repayment, period and amount of default, other long-term borrowing, trade payable, others, short-term borrowing, loan repayable on demand, banks, others, loans and advances from related party transactions, deposit, others, notes. If company has borrowing, security of disclose quarterly return, security of current assets, then you will be disclosing these 2 points, CARO points again. Quarterly returns or statement of current assets should be as per the books of accounts. If not, then summary of reconciliation and the reasons should be disclosed. This is borrowings. The next item is other one only. Provisions and contingent liability. Trade payable no need to do, because trade receivable we will do, and ulta of that is only trade payable. So last one, provisions and contingent liability. What is provision, what is contingent liability we saw. Next we went to audit procedures, and last one was disclosures. Disclosures same as schedule 3. Now only what is provision, what is contingent liability, audit procedures. That's it. Then we'll go for short commercial break. Is that okay? What is provision? It is a liability measured by degree of estimation. It is recognized when present obligation as a result of past event. Probable that outflow of resources will be required to settle the obligation, and a reliable estimate. Example for provision, you all told me provision for bad and doubtful debts, provision for taxes and all of those things. Contingent liability and provision for warranty, that also will become. Warranty means I am making a sale for legal or constructive basis. Yes, constructive means provision for bad and doubtful debts. Warranty means you have to compulsorily have that provision, because if you make a sale for 10 lakhs, month on month you are recognizing that 1 lakh is coming as a return for warranty. So you have to undergo that repair expense. So you will be creating a provision for warranty there. Contingent liability means material uncertainty. There is a 50-50 probability. Example we saw was lawsuit. So it is a possible obligation arising from past event and whose existence will be confirmed by occurrence or non-occurrence of one or more events not within the control of the entity, or present obligation arising from past event but not recognized that it is not probable that outflow of resources will be required to settle the obligation, or amount of obligation cannot be measured with reliability, because at this date I do not know whether I will win or lose the case. Even if I lose the case, what is the amount of outflow which will go, I do not know. So that is a contingent liability for me. What are the audit procedures here? Are they talking anything about assertions? No. Direct general audit procedures. List of all provisions, compare with ledgers, inspect agreement with the customers, underlying working from management, and obtain expert underlying work. How will you use the management expert? Evaluate the competence, capability and objectivity. When was this asked? September 24. You will know. Evaluate competence, capability and objectivity. How will you see this? Whether he is an independent party or he has been employed by the entity itself. What is the previous experience with the expert? What is his knowledge, qualification, and what membership, and where professional body he has the membership, you will be seeing. Next is obtain understanding of work of expert. How are you going to obtain an understanding? Whether the auditor has the expert to evaluate assumptions and methods used by management, nature of internal or external data of expert. Evaluate the appropriateness. Here you will be seeing the relevance and reasonableness of the source data, and you will be getting a written representation from management for all the provisions which is created. With this, the liability side of items of FS is completed. Now, warm notes of PPE. PPE mind mapping, how did we start off? That was the biggest mind map, correct? Recognition criteria, elements of cost, cost which is added, cost which is excluded, then comes audit procedures, and then disclosures. Under audit procedures, how many points are there? 4 assertions are there. What are the 4? Existence, completeness, valuation and rights also is there. Obligation and all will not come for asset. Obligation is only for liability. So rights only is for asset. Now, under PPE, the recognition criteria is when there is future economic benefits, cost can be measured reliably and it can be measured at cost. You can read it, correct? Elements of cost. PPE include purchase price and includes import duty and non-refundable purchase tax after deducting trade discount and debate. You will not be reducing what? Cash discount here. Directly attributable to bring to location and the condition. Initial estimate of dismantling, removing, all of these things will be directly attributable cost. Directly attributable cost, specifically they have told employee benefit AS 15 will be a directly attributable cost, but something related to employees, they said that it is not directly attributable cost. Staff training cost is not directly attributable. So employee benefit as per AS 15, site preparation, initial delivery and handling, installation and assembly, cost of testing, doing the samples, and professional fees also will be directly attributable cost. Cost which is not PP, only 4 points. Inauguration cost, introduction of a new product or service, a new business or customer, and admin or other general overheads. The next is the audit procedures. You told me there are 4 assertions. The first one being existence. Existence na sonnale physical verification. It can be done by own staff or third party, and periodicity will be decided by the company. So as an auditor, we will have to ask them whether they are doing once in a year or once in 2 or 3 years. If proper supervision is done, and physical verification report must be given. In that report only, all the items of PPE must be properly tagged and it has to be properly reconciled with the fixed asset register. And if there is any discrepancy, that has to be accounted for properly. Completeness means what? The movement in the fixed asset schedule, that is opening plus addition minus deletion, that gives you the closing. Now this talks about the arithmetical accuracy, where you will be tallying the opening balance to the previous year, and under completeness only there is addition and deletion. The same addition and deletion we also saw for intangible asset. Same completeness addition deletion we saw. Under addition, here expenses meet the criteria for AS 10. In intangible asset, expenses meet the criteria for AS 26. Like that we did a comparison. You remember? Now spare parts, standby, servicing equipment as per AS 10. Otherwise it will be inventory. You will test purchase the invoices and get the installation certificate. See whether any addition to PP is approved by the authorized personnel. If there is internal process for quotation, floating tenders, etc. The same points will be there for deletion also, because when you delete also you need to get the quotation, floating tenders, understand the reason and rationale for deletion. Here also you require management approval. Accurately recorded and accumulated depreciation up to the date of disposal must be there. Process followed, comparative quotes and tenders. The next assertion is the valuation assertion. Valuation means you talk about depreciation. The depreciation is done for all items, and if it is a non-depreciable item, for example freehold land, you will not be calculating the depreciation. So depreciation reflects the pattern of future economic benefits, and if there is any impairment, it has to be done under AS 28. Then comes rights. Rights means they are the legal owner, legal title that they only have. So whenever there is a purchase invoice of PPE, what is the name in that invoice? Addition to land and building, you will be checking the sale deed, conveyance sale deed. Original title deeds you will be checking, and security, if it is used for borrowing, then you will get a confirmation from the lender, and register of charges. Next is disclosures, classification, land, building, plant, furniture, fixtures, vehicle, office equipment and others. Lease assets specify separately under each class. Reconciliation, if change is more than 10% in each class, you have to show it separately. Any sum written off, reduction of capital, revaluation of asset for a period of 5 years, 5 succeeding years, you will have to show. This third and fourth point will again flow through in intangible assets also. Next comes intangible asset. Here the mind mapping flowed as what is intangible asset, what are the audit procedures, and what are the disclosures. Now what is intangible asset? It is an identifiable non-monetary asset without physical substance, held for use in production, supply, rental or administration. It is internally generated goodwill is not an asset. Can I say goodwill itself is not an asset? No. Purchased goodwill will be an intangible asset, but any goodwill which is internally generated, for example, I told you Domino's, wherever they open the outlet, you will definitely know that pizzas will get sold. There you know that there is a goodwill which is created, but that is an internally generated goodwill. You will not know what is the value of that goodwill, so you will not be recognizing that as intangible asset. But a goodwill which is arising because of purchase, where the valuation is 4 crores, but you paid 5 crores to purchase a business. So here the 1 crore which you are paying extra is called as purchased goodwill. That will be an intangible asset as per AS 26. Next is audit procedure. Under this again there are 4 assertions: existence, valuation, completeness and rights is also there. Existence, whether it is in active use. If it is not in active use, that means the intangible asset has been deleted. If it has been deleted, whether it has been recorded in the books of accounts, and if it has been deleted, it should also be after the approval of the top management. What is completeness? The same thing of PPE, verify the movement, opening plus addition minus deletion will give you the closing, and arithmetical accuracy. For addition, recognition criteria, there it was as per AS 10, here it is as per AS 26. There we spoke about spare parts and all. Here research phase of internal project should be an expense and it should not be an intangible asset. Certificate or report to verify the date of use of intangible asset. If there is any addition, then approval by the appropriate personnel must be there. Internal process must be there for competitive quotes and tenders. Deletion, simply you cannot delete, there must be a reason and a rationale for deletion. Approval and disposal note must be there. The process of sale must be given properly and accurately recorded for deletion, and it should be recorded in the general ledger also. For valuation, there we saw depreciation for PP. Here you're going to see amortization. Charge the amortization over the useful life. This is going to reflect the pattern of future economic benefits again. There also we saw this future economic benefits. There also we saw AS 28 impairment. Here also same thing. Rights. Expense invoice or purchase contract. It should have the name of the entity. There also we saw whenever there is a purchase of PPE, the name must be there in the invoice. The disclosure, the classification must be given as goodwill, software, mastheads, or publishing title, mining rights, copyright, trademark, intellectual property rights, recipe, formula, design, model, prototype, license, franchisee, everything. The same third and fourth point, reconciliation. Revaluation more than 10% if it is there for each class, you will have to mention that separately, and sum written for reduction of capital or revaluation of assets for the succeeding 5 years period, you will have to show that. The next is trade receivables, which is the opposite of trade payables. From there it is flowing, and from trade receivables you can actually map it to loans and advances, multiple points. So trade receivables, what are the mind mapping that we did? The first one a little different, it was the test of controls for internal controls over sales, because trade receivable means we have to receive the money for whatever we have sold previously. So from there it is flowing. Then we went to audit procedures. Under audit procedures, how many are there? 3. What are the 3? Existence, completeness, valuation, and there is also direct confirmation procedure. Whenever there is a trade receivable, trade payable, there is a direct confirmation procedure. Now, coming to test of controls for internal control over sales for debtors, only bona fide sales leads to trade receivables. There must be segregation of duties. If there is any credit sales, it has to be collected on time. If it is not collected on time, whether reminders have been sent and whether legal action has been taken for the credit sale which has done. The balances, whether it has been regularly reviewed by the management, whether the sale has been done only to approved customers and the sale has been recorded in the books of accounts. You can either settle it by receipt of cash or by an approving authority, we saw. And aging schedule, always trade receivable, trade payable, aging should be a point. Next is completeness. Completeness killer, they're talking about cutoff procedures where the sales must not be understated or overstated. Under that last few days of invoices, that is 5 or 10 invoices on the last few days, you will be picking and you will be seeing whether it is pertaining to this period only. Apart from this, goods dispatched prior to the period end has to be invoiced in that period itself, and goods dispatched after the period end must not be invoiced. Aging report la you will be testing the invoices, match the invoices to shipping or dispatch log, and few sales point we saw. What is bill and hold sales? I will bill now but I will not sell the product, I will sell after 2-3 days. Subscription model example and all I told you. Receiving log, I will bill now, I will sell now, and the next year I will take it as a return. So I will see the receiving log for the company. What is the returns which has happened? What are the discounts, incentives given, and what is the credit memo? This is under completeness. The next is valuation. Again, aging report, debtors under litigation. If there is any provisions for the doubtful debts, whether there are any doubtful debtors, what is the schedule of the movement, and whether it is approved by the appropriate authority. The next is existence. Controls are in place that invoices are not recorded more than once, because I will just sell once and I will record 10 invoices. I will inflate my sale, inflate my profits. As an auditor, we need to check that all those things are not happening. Balances are automatically recorded. Period end accounts receivable, aging report, again trace the balances with the general ledger. Realization must be recorded chronologically, invoice wise, FIFO, we saw that point here. Invoice wise it has to be done. Large balances which is due for a long time, you have to ask for reasons as to why it is due for a long time and what is the justification. Direct confirmation procedure, you can contact the customer directly and you will be asking all the confirmations from them. How can you ask the confirmation? Either you will be giving the outstanding amount or you will ask them to give the outstanding amount. Form with balance, without balance. Date, it can be at balance sheet date or any other date which is close to the balance sheet date. Consent must be received by the client, but the method of selecting the trade receivables must not be revealed to the client. Method of selection do not reveal to the company. Discrepancies, if there is any, then it will have a bearing on all the other accounts. And if the external confirmation is not working, that is no reply has been received, then we will be doing a alternate audit procedure. Later, if cash is received subsequently, no problem. Otherwise, we will be doing a detailed analysis. If there is a related party receivable, see whether it is at arm's length principle, see the trend line analytical procedures. Receivables other than sales or services must not be there in the list, because trade receivables means you are selling something and because of that credit period they are falling due. So other than sales or services must not be there, and few disclosures. This is trade receivables, exactly the opposite of trade payables. Where and all did we see opposite of trade payables here? Under this direct confirmation procedure. Under disclosures, they are also secured, considered good, unsecured, considered good, doubtful, debts due by directors, firms or company in which a director is there. Same points we saw. Valuation also similar. No, valuation from here will flow here. Under litigation, compare loans, same thing will be flowing here. So from trade payables, only direct confirmation procedure. Completeness. Existence also. Yes, existence also. Existence and direct confirmation procedures. Now loans and advances. Loans and advances here also includes, this is loans and advances in the asset side of the balance sheet. The company has given the loan and it has to receive the loan back. It includes loans and advances which is given to related party, and any advance which is given as a security deposit, and any amount which is given in cash or kind. So other current assets includes balances with statutory or government authorities also. What are the audit procedures? Here only 3: existence, valuation and completeness. Existence, direct confirmation procedure similar to trade receivables. Here we saw, correct, trade receivables, but here direct confirmation procedure, same thing will flow, but along with the principal plus interest also will be there. Also include interest receivable, also included as part of balance verification. The next assertion is the completeness assertion for loans and advances. That is, the company is giving a loan and it is in the asset side. How do I know that it is complete figure? For that, list of all the advances and other current assets, ledger balance, I will get the loan agreement and acknowledgement as per MOA, AOA and advanced by directors and partners of the firm and trustees of the trust. Minutes of the meeting of board of directors, any security deposited against due repayment, any related party loan and advances, whether it is an arm's length authorized and whether it is reasonable, and GST input tax credit. This also the reasonability we will have to see. I also told you about the question they asked specifically with GST input tax credit. That time you will have to write what are the returns which is filed, if there is any refund, how is the books of accounts showing, and if there is any amount which is received at a subsequent date, how are you showing it in the bank statement. The next is what? Valuation. Again, aging report, loans and advance under litigation, compare it with the previous year. If loans and advance appear doubtful, how will you treat that? Bad loans and advances written off. How can you written off? Somebody has to approve and authorize the loans and advances to be written off, and if the loans have been received in foreign currency, then you will be showing as per AS 11. Next is disclosure, long term, short term, and common disclosure for short term and long term. Under long term classified as capital advances, related party, others. Short term again classified as related party and others. For related party transaction, you will have to show the type of borrower, amount and percentage to the total. Common disclosure for both loans and advances due by director, firms or company in which director or director partner member, secured considered good, unsecured considered good and doubtful. Here undisputed trade receivable which is good, doubtful, undisputed trade receivable which is good, doubtful, outstanding from due date of the payment. Now the aging will start from less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years and more than 3 years. Is that clear, guys? Is it ringing a bell? Are you able to map the points once we are going through the WAV notes? The next is inventory and cash equivalent. Under inventory, what was the mind mapping that we did? What is inventory? Audit procedures and disclosures. What is inventory is given here. We saw inventory and 3 points were there: raw material, work in progress, finished goods. Held for sale in ordinary course of business, that is the finished goods. Inventories are assets in process of production, that is the work in progress. Inventories are assets, materials or supplies consumed in the production process, that is raw materials. So raw material, work in progress and finished goods, these are the assets, and what is inventory is these 3 points only. Coming to the audit procedures, how many are there here? 4 are there: existence, valuation, completeness and rights is also there. Coming to the existence. Now actually there are only 6 points in existence, and the last point with regard to test count, and under that so many general points were there if you remember. So quickly let's go through the first 6 points of existence. Now existence to sonna inventory, physical verification of inventory you will have to check. Who will be doing the physical verification? The management, the company. Review the entity's plan for inventory count. If there is any consigned goods, whether it has been segregated properly, it should not be mixed with the total inventory. An auditor should participate in the inventory count. Periodic system, if it is at the end of the period, and if it is perpetual system, you can do the inventory count at interim dates also. If the inventory is held with a third party, then you will be investigating with the third party directly. Then you will be doing the test count. All the 6 points are with respect to physical verification of inventory, because we are talking about existence of the inventory. Now under the test count only there are multiple general points. 10 points are there. First one is observe that the employee is doing the proper inventory count. I told you the example of GRT where they'll have to do the inventory count every single night. So whether they are actually doing that, and one person has to supervise it. Whether there is tags for the inventory, and the tag need not specifically be only financial information, even non-financial information like weight can be there on the tag. All items must be tag, and tag must be proper amount. Tag of summary sheet, tax is given, it is tag. tag of proper amount, tag and summary sheets whether it is controlled and reconciled, discrepancy in the reconciliation whether it is summarized and agreed with the client, staying alert for any empty box or obsolete item, cut-off procedure. For that you will be seeing the last 5 to 10 shipping documents, exclude any damaged stock, obsolete stock or any third party stock which is lying with the company, you will be excluding, accounting of all the stock sheet and difference between physical stock and stock records. All of these general points is under test count. The first 6 was for physical verification of inventory, which was for the assertion existence. Now comes completeness of inventory. Completeness means inventory held by the entity is there. Inventory held by third party lying with the company is not there. Inventory owned by the entity lying with third party is there. Is that clear? This 3 is what is talking about what is completeness. Now under that analytical procedures, under that few ratios are there. Inventory turnover ratio, COGS by average inventory, vertical analysis can be given, inventory by total assets and budgetary versus actual inventory. Non-financial information weight also can be given. Now inventory is flowing from where you purchase the material, it is as inventory, and from the inventory you are going to give the sale. So the purchase and sales cut-off procedures has to be done for seeing whether the inventory valuation is complete. Tagged inventory you will be testing for omitted transactions or invalid transactions. Reconcile for perpetual records, general ledger which is there with the third party, and anything which is given on consignment basis must not be included along with the inventory, it must be segregated properly. This is the completeness. What is valuation? Valuation of inventory is cost or net realizable value, whichever is lower, and whether they are using FIFO or LIFO or weighted average, consistently they will have to use that. Now under valuation only we also saw raw materials, work in progress separately and finished goods separately. Reasonableness of the method used, FIFO, LIFO or weighted average. For raw materials, what are the elements of cost which you will be considering? Standard versus actual cost. If there is any variance analysis that you have to do, what is the test check? If there is any damaged or obsolete inventory, you will obviously take it at net realizable value because it is damaged and obsolete, it will be lower than cost, so that's the reason why you are taking as net realizable value. What is work in progress? You will be measuring the cost appropriately. What are the elements of cost? And here also you will exclude all the abnormal wastage. Finished goods, here you will be valuing at NRV if lesser than cost. That means cost or NRV whichever is lower. And valuation of obsolete, damaged, slow moving inventory must not be there, and inventory aging split must be given. Apart from this, compare recorded cost with replacement cost, vendor price list, inventory turnover ratio in manufacturing environment, test the overhead allocation rate. This is under valuation of the inventory. The next assertion is the rights of the inventory. Rights means the valid legal ownership is held by the entity only. Here what will you see? The invoice must have the name that it is owned by the company, that is vouch the purchase with documentation. You can see the PO, you can see the invoice, you can see cancel check, payment file, receiving report and all of those things. Invoices must have the name of the client. Material purchased must be having the commitment agreement, consignment agreement. If there is any collateral agreement or there is any side agreements, you will be seeing client correspondence with sales and receivable records, purchase record and declaration from the third party in the letterhead. Last part, disclosure. Raw material, work in progress, finished goods, and if there is any stock in trade you will have to mention that separately. Stores and spares, loose tools, others, whether goods in transit, that also must be separately disclosed under each of the subheading. Is that clear? This is with inventory. Easy, half a page. Full inventory in half a page. Next one is cash and cash equivalent, 1/4 of a page, small one down. Pavama, it is sitting here. Cash and cash equivalent. What are the mind mapping we saw here? Audit procedures and disclosure. Under audit procedures, existence and completeness, you will be doing the surprise check. If there is more than one cash balance, that is maybe there is a cashier, petty cashier and also employees having different cash balances, simultaneously you will be checking the cash check simultaneously, and when you are checking, the cashier must be present, otherwise he is going to be like, when I gave it to you cash was there, now cash is missing, he is going to put the blame on you. If there is any rough cash book, then whether entries are flowing from the rough cash book, you will see. If it is approved by authorized official, you will also do cash sensitivity analysis and bank reconciliation statement. How are you going to do the BRS is given here. You will be tallying the bank book with the bank statement. If the checks issued but not presented for payment, then the bank statement will subsequent period verify if it is cleared. Check becomes stale or more than 3 months have been lapsed, then it should be as a liability. Material reconciling items, then you will be requesting for bank statement. If management doesn't adjust, then you can even go for qualification of the report. Checks deposited but not credited by the bank, then in your accounts it will reduce the bank balance, but in your account it will increase the bank balance, but in actual bank statement it will not be reflected. So the check deposited later when it is credited by the bank, so you will be asking for bank deposit slip. Checks not cleared beyond reasonable time. Why is it not cleared? You will be asking for explanation. If that explanation is unsatisfactory, then you will verify the revenue recognition. Direct confirmation procedure, to whom will you ask directly? To the banker only you will be asking directly. Confirmation of 100% of the bank account balances you can ask. This material is done olden days, so they are saying, how will you get the direct confirmation procedure? Your team member along with management team member, both of you will go physically to the banker and ask them for the statement, not statement, for the balance. Next is disclosure, classification, cash in hand, cash in bank, check, draft in hand, otherwise. Earmarked balances you will show. This is also called as fund. Margin money or security, if it is shown separately, you will be showing that. Repatriation restrictions if it's there, and any deposits which is more than 12 months, you will have to show that separately. With this, the balance sheet items comes to an end. The assertions for profit and loss items: occurrence, completeness, cut-off procedures, measurement, presentation and disclosure. So with these 5 assertions in mind, and also with whatever we have discussed right now, sales and purchases is going to be the easiest. Because you can write like 30 points for sales and 30 points for purchases. It's just going to be ulta of sales, correct? Purchases. After that, for other income, I told you there is interest, dividend and gain or loss on sale of investments. Gain or loss on sale of investments is very easy, because there's going to be one redemption price and there is going to be one carrying value. So the redemption price minus carrying value will give you the value of the asset. And what about the transfer of the title? If there is any mutual fund, all of those points you will have to write. For interest, again it's going to be very, very easy. How will you do any kind of interest calculation? If there is any fixed deposit into the interest amount into the period. So like that you will be doing the arithmetical accuracy, which is basically a re-performance activity. So all of these things you will be writing. And for dividend also, all your law points, that is dividend, when will you actually show it in your accounts? Only when right to receive the dividend is established. From there you will be flowing for the dividends. Next, for sales, you can be as creative as possible for sales and purchases. You can talk about credit sales, credit purchases, you can talk about discounts, you can talk about incentives, you can talk about GST sales, GST purchases, you can talk about sales from foreign currency, AS11 restatement, you can talk about sales to related parties, purchases from related parties. So you can get as creative as possible with sales and purchases. Bala, which one is yours? Depreciation amortization, which is very, very easy. It is an expense, and when will you recognize that expense? When will you start charging depreciation? From when you buy the asset, or from when you start using the asset, you will have to see. And depreciation is basically a calculation. So again, re-performance activity, arithmetical accuracy will come into place. And amortization is going to be for intangible assets. So whatever accounting standard is for depreciation, whatever accounting standard is for amortization, you can mention all of those things, and also talk about the useful life and all of those things. For you, what was it?
employee benefit expense is basically your salary. So when will you give the salary? How is the attendance of the employees going to be? What are you going to check for that? And apart from just salaries, what other things are you giving? Are you giving ESOPs? Are you giving rights? Are you giving bonus shares to your employees? Or what kind of ID proof are you collecting from your employees? Employees will enter, employees will also exit the company. So what is the approvals? What is the interview process? And do they have an interview process for exit also? Exit interviews, all those points you can see. And if PF, ESI, that is also a very important areas for employee benefit expenses. Have I covered everything? Everybody's I have covered, right? All right. With this, for sales, I would want you to write about 15 points. Purchases also 15 points. For other income, each of the interest, dividend and gain or loss on sale of investments, you can write 3 points for each or 4 points for each. For employee benefits, you can write 10 points for employee benefit expense, and depreciation amortization again 10 points. I have also given the clues. Now online students, you will have to write everything. Start from sales, purchase. Try writing for everything on your own with whatever data I have given you. Online students. For trade receivables also there were few sales points, correct? Sales was only given to approved customers. Only bona fide sales are translated to trade receivables. Purchases, you can also write about the inward factory gate register, goods received note, ITC ledger for purchases, and for sales it can be GST returns. Purchase means there is going to be stock coming inside, so stock inward register. Sales means stock is going outside, so stock outward register. So many points for sales and purchases. Good, listen here. Listen here. Now for this, I'm directly going to the WOW notes for P&L captions. Now for sale of products or services, these are the points in a concise way I have given. Listen, listen. Now for the person who is doing sales, for her she'll be able to appreciate all the points. Now for all the others, I want you to think of all the sales points in your head so that you'll be able to appreciate these points. The first one being, whether a single sales invoice has been recorded twice, and whether a cancelled invoice has been recorded, because a sale will happen and then later there is a cancellation. The books of accounts has to show that there is a cancellation, whether it has been shown or not. External confirmation essay 505 for the genuineness of the sales transaction. As an audit procedure you can do. Sequence of the sales invoices. If you see the invoices, it will start off from 1, 2, 3, 4. Same sequence it will go through. So whatever is the sequence of the sales invoices, you will have to see. Now sales, whether it is actually to authorized customers or whether it is fictitious customers, we will be seeing. Now whatever sales entry is happening, how will the entry be? Party account debit to sales account, and then later cash account debit to party account. Now how is the journal entry done? Whether it is directly cash account to sales or party to sales and then later cash to sales, like that you will be reviewing the journal entries. Now sales to sonna, simply to inflate the sales at the end of the year, they can inflate and then do the sales return after the period. So what is the sales return ratio? You can compare this ratio with the previous year. Sales pertaining to this period only must be there here. So cut-off procedures also must be seen for sales. How will you see the cut-off procedures? Last 5 invoices for this year you will be seeing, and you will be checking the genuineness of those invoices. If there is any credit notes which is issued after the accounting period, that means I'm making the sale now and after the accounting period I'm issuing the credit note. That means it is similar to a sales return. I'm cancelling the sales which happened. Did something like that happen? Auditor will have to check. When there is a sales transaction happening, I am also collecting GST from other people. So the company, when it collects the GST, can it keep it with itself? No, it has to be filed with the government. So whether GST returns are appropriately filed.
Trace the transactions from the inception, that is tracing audit trail they are asking you to check. If there is any export sales made, then restatement of foreign currency has to be done as per accounting standard 11. If sale has been made to related party transaction, then arm's length basis or ordinary course of business only the sale has to be done. If there is any brokerage paid or discount on sales, whether it has been disclosed other than trade discount. If there is a trade discount, you do not have to disclose it here. All these points are for sales. How many did you cover out of this? More than half? Yes? Good. Very good. Next, I'll jump directly to purchases. Now when I'm showing purchases, I need to know, like how for sales I saw whether it is authorized customers. Here also it has to be authorized vendor. So is there any fictitious vendor? I will have to check. If I'm making a purchase, that means stock is entering into the company. So inward register at the factory gate, I will be checking that also. Now when I'm paying money, proper quality of material has to come inside. Now here for sales we saw quality was not good, so sales return happened. So here quality inspection has to be done. Whoever is receiving the goods, he is responsible that the goods have actually entered the premise and quality inspection has been done. So goods received note, whether it has been signed by the appropriate personnel. What is the stock record which has been maintained, because purchase panna it is going to directly hit the stock of the company. So what is the stock record? How is the purchase invoice recorded? What is the accounting entry? And also does the invoice have the name of the entity? That means who is owning this material which is entering inside. So name of the entity, whether it is there. In sales we saw GST return. Here we are going to see ITC ledger. Purchases can also be made from related party transaction, whether it is in the ordinary course of business. We will have to see how are the journal entries being posted in the books of accounts. If the purchase, whether it is a capital purchase or whether it is a purchase which is respect to a expense, we will have to see. Here also cut-off procedures, last 5 invoices to the period end we will be seeing. And we can get a written representation. Did you write this point? That all the transactions have been recorded, a written representation from the management, and so many analytical procedures, a trend analysis from the previous year, ratio analysis, current turnover ratio, stock turnover ratio, stock composition, consumption analysis, all of these analytical procedures can be done for purchases. How many points did you cover? 10 points you have covered out of everything. Very good. Next is other income, very small. For interest, we know that for the FD open multiplied by interest rate multiplied by number of days is the way you will have to calculate. So you will be doing a recalculation exercise here. Arithmetical accuracy, reperformance. You can also get a third party confirmation for the fixed deposit from the banker itself. Form 26A TDS, did you write this point? No. TDS form 26A, if your interest is there, tax will be deducted at source. So you will have to write that point also. For dividend, the right to receive the dividend must be established. Economic benefits must be with the entity and dividend must be reliably measured. All 3 points written. 2 written out of 3. Very good. And for gain or loss on sale of investment, you just have to write about the transfer of title and MF statement and redemption price minus the carrying value of the investment. That's it. Simple. And interest has to be done at a time proportionate basis. That is only this calculation into number of days. So it is proportionate to the time. Is that clear? Easy one. Next is employee benefit expenses. See the number of points which you have covered. You will be checking the employee attendance, because based on the attendance only you will be paying the salary. Whether there are fictitious employees, you will be meeting them in person on a sample basis. Now the company, for paying the salary, they will be getting all the bank details and the ID proof, Aadhaar card, all the other proofs they will be getting, whether they have received all of those things. If it is a new hire, that means a new person who is entering, you will be checking whether appointment letter has been given, and check for salary disbursement also. New person is there, so salary has to start going to that person on a monthly basis. So salary disbursement you will be checking. For people who are leaving, resigned employees, full and final settlement, that compensation has to be given, F&F settlement has to be given. For PF, ESI, the deposit challans has to be checked, and here also you can do a trend analysis with the previous year analytical procedure. And very, very important, for salary, a provision will be created on 31st March of every month, and in the next month on 4th or 5th only the salary will be disbursed, but on 31st March the provision will be created. That point did you write? Only this provision point you did not write, others everything you have written. Very good. Next is depreciation and amortization. Small points only are given. Depreciation is basically with respect to the fixed assets register. Fixed assets nu sonnale whether physical verification has been done, whether it is a capital or revenue expenditure. The depreciation calculation has to be re-performed or recalculated to check the arithmetical accuracy, and see whether the depreciation is starting from when it is ready to use and not from actual usage, or not from date of purchase. Only from when it is ready to use you will be charging the depreciation. And useful life calculation also you will have to see. All points covered? Very good. Everything is covered. Only one is left, which is other expenses. Other expenses pertaining to rent, power and fuel, legal and professional expense, travel, repairs, maintenance, printing, stationery, miscellaneous, and insurance expense. Very simple points. When there is a rental expense of 1 lakh rupee month on month, if there is a rental expense, as an auditor, what are the audit procedures that you will see? There will be an agreement. First thing you will be seeing the rental agreement. Mostly the rental agreement will be for 11 months, because if it is for 12 months or more, it has to get registered. That also you will see as per a 12 months period. Every agreement will have an escalation clause. Escalation clause means first 2 years, this is the rent. After the 2 years, that is from the third year, 10% increase. From the fifth year, 20% increase. Like that, there will be an escalation clause in the rental agreement. You will be seeing that. And most importantly, who has entered into this agreement? Whether the company has entered or a director has entered, you will have to see all of this. Name of the person who is entering into the agreement. Insurance expense. Insurance expense means the company is paying insurance for its employees or for its directors. Here, summary of the insurance policy along with the validity period. Now here, this is an expense which is being prepaid by the company, for which the benefits will be given at a later stage. Classification of prepaid expenses and the expenses for the period. That's it. Which one? Employee benefit is what? Prepaid. Employee benefit, how is that prepaid? Insurance policy. Oh yeah, for employees, if they have taken any insurance, you can write that point there also. Now for power and fuel, how will you see power and fuel? Maybe it is for a generator in the company. It is an expense as part of the company. How will you see? You can do a trend analysis. Now power and fuel means you will be seeing the month-wise schedule for all the 12 months, so that you will know whether it is in the same range. And you will also see the power units which is linked with the finished goods. That means if I am producing 10,000 units of finished goods, I am incurring a cost of 50,000 rupees. If I am producing only 2,000 units of finished goods, I should not be incurring a cost of 50,000 rupees for fuel, power. Yes or no? My cost there also should reduce. So link with finished goods the power units, and then here also arithmetical accuracy. You can do trend analysis, recalculation, and all of those things. Legal and professional expenses. Here there is an ad suit, there is a lawyer, and for them we are paying them expenses, or it can also be auditor expenses. Now sometimes these expenses will be paid for job basis, or these expenses will be paid for retainership. That means I will be paying you month on month. If notice comes, you are going to take care of. 10 notice comes also, this is a payment. 1 notice come also, this is the payment. No notice come also, this is a payment. So whether they have entered into a retainership, if there is a retainership, all 12 months whether it has been covered. Now these legal and professional expenses, these can happen on a one-time time basis also, not necessary that it has to incur for all the 12 months. So here you will be seeing the month wise and consultant wise summary, and if it is non-recurring, you will be selecting the sample and you will be doing an external confirmation for that sample. Next is travel, repair, maintenance, printing, stationery, miscellaneous expenditure. Now this miscellaneous expenditure for a 12-month period if you take, you should be able to find a trend because they will be in the same levels only. Summary of all expenses and compare the trend, that is only the analytical procedure. Here, when you incur all these expenses together, the per unit produced cost you can find. Say for example, I am doing maintenance, printing, stationery and all these miscellaneous expenses for producing 10,000 units of finished goods. Now, if I incur 1 lakh rupees for 10,000 units of finished goods, that means for 1 unit, how much am I incurring? For 1 unit, how much am I incurring? 10 rupees I am incurring per unit. Now if I increase the number of units, automatically my per unit cost must reduce, economies of scale. So all of those things, per unit produced cost, and compare with previous year, and industry trends also you can compare. Other industries in the same size, they are not spending 1 lakh. Why are you spending 1 lakh? Like that you can ask. Reasons for significant variations. All of this is other expenses. Here there are few disclosures: classification under rent, insurance, power and fuel, repair and maintenance, legal, professional, printing, stationery, travel, miscellaneous, all of these things you have to separately classify them and give us disclosure. That's it, P&L captions. But here if you see, there will be pointers given, but whatever we discussed here only will be there. Whatever we discussed will be there. So have the VAV notes on one side and have the concept notes and just see what are all the points which is discussed as per this. Is that clear? Same other income also, same few points. Easy, right? P&L easy. தெரிஞ்சிருந்தா இப்படியே balance sheet க்கு படிக்கலாம். Full VAV. I'll tell you why this is most important. In CARO also, how many clauses did we read? 21 clauses we read, and I told you the most important one is the applicability of CARO. எல்லாம் முடிச்சிட்டு மண்டை மேல இருக்கிற கொண்ட மறந்தா கடைசியா he will ask the question there only. Same way, items of FS, so many items in balance sheet, so many items in P&L, but எல்லாம் முடிச்சு you will forget the additional information. From here, multiple times they have asked questions in the past. So if they ask this time, you will not be leaving it. So let us finish the additional information also. Is that clear? Now from the material itself, let's do the additional information, because there's quite a few here in the material. Here actually, let me tell you the difference between the material and the VAV notes. In the VAV notes, the additional information of these 5, which is the most important, which is given as additional information in your study material, ICA study material also. These 5 are given. But if you see here and there, inside the items, whatever is missed, I have given as additional information. That's why here A, B, C, D, E, these 5 are what is the additional information as per the study material, and these are whatever is missed inside in the items which I have given. I have made that as additional information. Is that clear? Apart from this, this is the important disclosures which is to be made. Apart from this, we also have, let me show you. This, the other topics. The other topics is goods sent out on sale or return basis, borrowing from bank, goods sent on consignment, foreign travel expense, receipt of capital subsidy, provision for income tax, payment of tax, sales proceed of scrap material, and advertisement expenses. Now these are also important because here in my material I have given as other topics, but for you all it will be inside the study material somewhere, but it's not there in my concept book inside the material, so I have given it separately as other topics. These also are important, but more important is the important disclosures. So quickly let's go through the important disclosures. It's very easy. Disclosures are very easy. First one is, I told you these 5 are important disclosure as per study material, correct? So these 5 are extremely important. Starting off with the first one, CSR, Corporate Social Responsibilities. So for companies who are covered under Section 135 of the Companies Act, all these details has to be disclosed. What are the details? The amount which is required to be spent by the company. That means 2% of the average net profits. That is the requirement which is to be spent. Amount of expenditure incurred. So requirement may be 3 lakhs. What is incurred is only 2,85,000. So what is the shortfall at the end of the year? 15,000 is the shortfall. Total of previous year shortfall. Previous year there might be 5,000 shortfall, and this year there is a 15,000 shortfall. Reason for the shortfall. Reason means the project which I actually took the funds, the project is completed. So I have the money. Nature of the CSR activity, education. Blind people I am giving the education, or I am going to orphanages and I am educating them. Like that I can do a CSR activity. Details of related party transactions. That is CSR activity I am going to do it for a trust, and that trust is again controlled by me. If you see Reliance, what they did, they built a huge forest. Anant Ambani is taking care of the forest. All good name they got, correct? All of that is their CSR activity. Now their CSR activity, what they are doing for their own trust they are giving. So you have to mention this here. Details of related party transaction. Example, contribution to a trust which is controlled by the company in relation to CSR expenditure as per relevant accounting standards. Where a provision is made with respect to a liability by entering into a contractual agreement, the movements in the provision during the year should be shown separately. Say I am entering into a liability. That means I am telling an NGO, you do the work of educating the blind people. I will pay you monthly 20,000 rupees. Like that I am entering into a liability for the next 12 months or 24 months. Now at this 12 months period, I will still have the pending funds. So I will be giving the details because I have made a provision with respect to a liability where I will be giving the details. So here there are 8 points for companies covered under Section 135. For CSR, these 8 points of disclosure is mandatory. What are the 8 points? Amount required to be spent, amount spent, shortfall for the current year, previous year shortfall, reason for the shortfall, nature of CSR activity, related party transactions, and provisions and movements in the provisions. Is that clear? Going to the next one. Okay, round off. This is also important. Depending upon total income of company, figures appearing in the financial statement shall be rounded off as, if total income is less than 100 crores, then you can round off to nearest hundreds, thousands, lakhs or millions or decimals thereof. If it is 100 crores or more, then you will be rounding off to the nearest lakhs, millions or crores or decimals thereof. Once a unit of measurement is used, it should be used uniformly in the financial statements. One don't round off to lakhs, other one don't round off to crores. It doesn't make sense. The next is details of Binami property held. Now Binami means what? I am holding the property for somebody else. So if the company is holding the property for somebody else and under the Binami Transactions Prohibition Act, there is a lawsuit filed against the company, then you will have to give the details of such property, including year of acquisition. When did you purchase? What is the amount of the property? For whom are you holding? Details of the beneficiary. If property is shown in the books, then reference to item in balance sheet. If property is not shown in the books, then the fact of the same shall be stated with reasons. Where proceedings against the company under this law as an abettor of transaction or a transferor, then details shall be provided. Nature of the proceedings, status of the same, and company's view of the same. This is with regard to details of Binami property held. Now where else did we see this Binami property? clause number 1 under PPE of CARO, we saw if there is any proceedings pending against the Benami Prohibition Act, then you will have to mention a few details we saw. Yes, similar ones here also in the financial statements, you will have to give a disclosure. Details of property, year of acquisition, amount, details of beneficiary, if the property in the books, reference to the item. If property is not in the books, then the fact shall be stated with reasons. If proceedings under this law is there, nature of proceedings, status of the proceedings, and the company's view. This is the second one, details of Benami property held. First one was CSR. Second is Benami property held. Third is relationship with struck off companies. Where companies have any transaction with struck off company. Struck off company means a company has been registered with MCA 21. Later, for some reason, it is not compliant with the Companies Act. So that company itself is not there nu solli, there will be a striking off of that company in MCA 21. Now, if your company under audit is having some kind of a relationship with that struck off company, you have to give the details. Name of the struck off company. Nature of transactions, whether you have investments, whether there is a receivable, whether you have to pay that person, whether shares have been held by that struck off company in your company or any other balances. What is the balance outstanding and what is the relationship? It can be a holding, subsidiary, fellow subsidiary, associate, joint venture, some kind of a relationship, whatever you have with the struck off company, you have to give all the details. All of these 5 additional information have been tested previously. All the 5 have been tested. That's why multiple times I keep telling that these 5 are extremely important. The next one. Ratios to be disclosed. Current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivables turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. What you will do from A to K, you will keep reading what are the ratios. But you know where he will ask the question? In this line. What they are saying here is, you have to disclose all the ratio for this current year and also the previous year, and if the change in ratio is more than 25%, you have to give the reason for the same. So there was a RTP question where they gave the previous year ratio, current year ratio, and previous year usually will be written here and current year will be written here, correct? In the RTP they gave ulta. Current year was given first, previous year was given next. You have to see all of those things, which is the previous year, which is the current year, and they gave the ratios. You are expected to find the percentage difference between them and basically say all of these require extra information. Now just read this para. Company shall explain the items which is included in the numerator and denominator for computing above ratios. Further, explanation should be provided for any change in ratio more than 25% as compared to the previous year. Now for each of the ratio you have to see the percentage change. If it is more than 25%, explanation has to be given. That is where they will test. They will not ask what are the ratios to be disclosed. Is that clear? Now going to the next one, details of crypto or virtual currency. Do you know what is crypto, what is virtual currency? Have you invested in crypto or virtual currency? Bitcoin, Ethereum, Dogecoin, Catcoin, all these coins are coming. Yes, maybe they will take over the rupee itself. But do we understand them completely? No, we don't understand them, and it is not a regulated market also. Like the stock market, we have SEBI. For crypto or virtual currency, we do not have a regulatory market. So if a company has traded or invested in crypto or virtual currency, you have to mention the profit or loss made involving the cryptocurrency or virtual currency. How much currency are you holding as on 31st March? And some people will be there. I am a pro in crypto. You give me your money. I will take that money and I will invest for you. Like that, some companies will be there. So deposits or advances from any person for trading or investing in crypto or virtual currency, these 3 disclosures has to be made with respect to crypto or virtual currency. Utilization of now these 5 are done. I told you the first 5 are extremely important, correct? CSR, Benami property held, relationship with struck off company, ratios to be disclosed here. What was the percentage? More than 25% from the previous year, if it is there, what should you do? Reasons for the same explanation has to be given. Details of crypto or virtual currency, only 3 points here. Profit or loss made of crypto or virtual currency as on the reporting date. What is the currency that you are holding? What is the amount held? Any deposit or advance from third party, if you can finish. Next is 1, 2, 3, 4, 5. We'll finish these 5 also quickly. Next is utilization of borrowed funds and share premium. Yeah. Utilization of borrowed funds and shared premium. Where company has advanced or loaned or invested the funds, either borrowed funds or share premium or any other sources to any other person or entity, including foreign entity, with an understanding that intermediary shall direct or indirectly lend or invest. What are they saying? I have taken borrowed funds. Where am I going to use it? So here he has taken the borrowed fund and there is an intermediary. Now this intermediary will be directly or indirectly lending or investing on behalf of the company or provide any guarantee, security or the like on behalf of the ultimate beneficiary. In this case, the company will be disclosing these 4 points. Date and amount of fund advanced or loaned. Date and amount of fund further advanced or loan, because there is intermediary here. Date and amount of guarantee, security or the like provided to our behalf of the ultimate beneficiaries. Declaration that relevant provisions of FEMA and Companies Act have been complied, and also PMLA, that is Prevention of Money Laundering Act 2002, has been complied with. Company will be disclosing the following: date and amount of fund received, further advanced or loan, date and amount of guarantee, security or the like, FEMA, Companies Act, PMLA, same thing. Next is willful defaulter. What is the meaning of willful defaulter? Intentionally he has the money but still he will not repay the money. Example? Nirav Modi. He is a willful defaulter. That means a person or an issuer who or which is categorized as a willful defaulter by any bank or financial institution as per RBI guidelines on willful defaulter. If this company has been declared as willful defaulter, then what date have they declared as willful defaulter? Details of the default, amount and nature of default. Registration of charges or satisfaction with registrar of company. If there are any charges or satisfaction yet to be registered beyond the statutory period, then details and reasons must be disclosed. Title deeds of immovable property not held in the name of the company. That means immovable property is there, company is using that, but title is not in the name of the company. It can be in somebody else's, or promoter or director or employee or completely different third party also. In this case, he has to give the relevant line item in balance sheet, whether it is a machine, whether it is a land, whether it is a building, description of the property, gross carrying value, title deeds held in the name of whom, whether title deeds held as promoter, director or relative, property held since which date and reason. Where else did we see this? Clause 1 in CARO, there was a dabba, table which is given, where title deeds is held by somebody else. The same dabba is given here again. Capital work in progress. For capital work in progress, following aging schedule shall be given. Now, usually, what is work in progress? It is a inventory, correct? If it is a trade receivable or trade payable, we started off with less than 6 months. Here for capital work in progress, it is less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. Projects in progress, projects temporarily suspended, because this is capital work in progress. So here it is still in work in progress, means you will give that separately. It was in progress but now it cannot get completed. I am basically throwing whatever money I spent on that to the dustbin. That is, it has been suspended. Where completion is overdue or exceeded its cost compared to the original plan, then the schedule has to be given. Then project wise, details of project where activity has been suspended, it has to be completed less than 1 year, 1 to 2 years, 2 to 3 years and more than 3 years. Similar schedules are to be given for intangible assets under development. Is that clear? No. Please read through these again, very very important. This A to J, please read through this again. I'm sure till E you are all active. Once I told, after this it is not there in study material, from inside I took, you all were like, okay, let me leave this. Don't be like that. If they ask, you have to get the mark. Yes or no? 4 marks, easy to get. And items together, they will ask for 10 marks. Compulsory 10 marks. My kindest request is to take the printout of the WAV notes, stick it somewhere so that every time you see it, at least one item, some points, few points you will be hearing that WAV notes, assertion wise I have given for balance sheet items. Yes, you cannot miss it. Disclosures here and there I have missed it. When you take the print, there is space given. You yourself write the disclosures. Is that alright, guys? All the best. You have hardly few more days for the exam. Study well, don't waste the time. Go home, take rest, start studying from tomorrow. Today, lot of information.